So good morning, guys. Yeah. So let's chalo. So as I said, like 20 hours of class, correct? Na? 20 hours of class. I would like to cover financial reporting, right? That would be very sufficient. That's what I feel. Okay, right. If you, I mean, physically you are available, mentally also if you are present, no, then we can we can do something great, right? Before that, let me introduce myself. Yeah, Ravikanth, Ravikanth Myriala. Chartered accountant, qualified in 2006 November, almost 20 years, right? 20 years post qualification. Did articles with Pricewaterhouse and Deloitte, Pricewaterhouse. Post qualification was with PwC for 2 years approximately, plus Deloitte 3+ years. So with PwC it was IGAP. With Deloitte it was US GAAP and IFRS basically, which is now Ind AS, right? And after Deloitte I got into practice plus teaching. So that practice also not a traditional practice. My practice is right. One second. So that's not a traditional practice. That's purely like accounting standards and Ind AS consulting. Okay, consulting job again related to financial reporting. Your subject only. So whatever is that you are learning Ind AS, no, mostly like 90% I can say I must have already applied practically. Fine. Yeah. Very rare circumstances will be there. Those circumstances you will not see practically. Other than that, including your what do you call ECL, right? Expected credit losses. Just that I did for some two big NBFCs, like where the loan book is around 3,000 to 4,000 crores of loan book. So whatever you say there, it's already applied by me. Practically, I have experience either in consulting or I only have done the job for the client, right? So my entire career, if you see, that is purely on financial reporting. So I think I can add better value to your what do you call your studies, and that will be useful for your career. Correct, no? Right. So this and with respect to books, what I have written, there are 6 books which are for CA students. Like 2 books you will find for uh, Advanced Accounting Made Easy for CA Inter, Auditing and Assurance Made Easy for CA Inter, Ind AS Made Easy is one. One more was there FR Made Easy. Okay, and chart book is available. One more book for the professionals, that is Ind AS Made Easy for professionals basically. Okay, right. And one more book I wrote for FRRB, Financial Reporting Review Board of ICAI. That is the 3rd volume which is right now available in frrb.org if you type ICAI website. So that is drafted by me. If you go inside and if you type Ravikant, you will get there. Okay, obviously ICAI book you will not find my name on the top. ICAI only will be there. But yes, I have drafted. And I am actually this Ind AS course ka ICAI Ind AS course regular faculty, and do give presentations for many institutions, ICAI and outside other than ICAI also, corporate trainings and etc etc. Right. So that is about me. Right. Chalo, let's start the thing. So as I said, 20 hours, that is equal to 5 hours a day into 4 days. That's how 20 hours. In 20 hours में I am expecting all important standards to 100% will clear without doubt. Important standards, as you know, like say 109 or 102, correct na? 103 and 110, 115, 116. These are all very important, correct na? Approximately 45 to 50 marks are only here, correct na? 50 marks approximately plus or minus 5 marks, fine, are coming from these standards only, right? You will not find any question paper without 109, correct na? So that will be like from 8 marks to 16 marks or 20 marks, 109 only will be there. 115 may be there in one attempt, may not be there in another attempt, but yes, frequency is very high obviously. And 116, that gap is going to be filled by 116. If it is, sometimes both the standards have been asked in the same attempt. So those put together, I can say like somewhere around 16 marks will come. and 1 or 2 share based payments, correct? That is also very frequently, minimum 8 marks, correct? 6 to 8 marks or sometimes 12 marks also, rarely, but 8 marks question is so very frequently asked. Consolidation is there in every question paper, that is for the maximum number, correct? 16 marks approximately, you can say consolidation. That's why I say 50 marks are coming only from these few standards. Let's try to understand each and every adjustment. Okay, what is that we should do, what is given, how should we tackle it, right? Question solving, I will not write everything, fine, but I will take you through the question and answer, which is important question I felt, then I'll take you through, that will be more helpful to you, fine, right? But obviously all the questions will not be able to do it, which is important, correct? Which is something different, difficult, maybe previous year it's already asked, right? Not general understanding, it may not happen, fine, right? Good. Yeah, so whatever I am showing you is from my book Ind AS Made Easy material, volume number 1, that is a concept book. Volume number 2 is the question bank, basically, right? One good thing I should say, very happy to say, last attempt or last 2-3 attempts, if you take it, for January batch people, I will not suggest my book, obviously your 1 month also not there correctly, but in general, whenever I was trying to write the solutions for after question paper released, till the time suggested answer comes, correct? By the time I need to publish one more edition, right? So when I was writing, no, I have not written any answer, I have given only this refer so and so question, so and so page number. I mean to say, almost out of 120 marks, maybe 1 or 2, like say 10 marks you take it on conservatism, 110 marks are there in the textbook, because this textbook covers everything, my dear. All the concepts are covered. So you don't need to break your head like whether it is RPT, say I should refer, or this one I should refer. Why do you need to refer? It's already there at one place. One correctly study, that will be more than sufficient. And one more small information before starting. From January first week, say 2nd January, that's what we're planning. Obviously not for you guys who are writing in January, correct? Na? Right. For those thinking of May or little later, right? We are starting a new batch. January 2nd, it will be there for 2 months perfectly. Daily 3 hours. Sunday, obviously, little extended time will take it, right? So we'll be covering 100% of syllabus. If required, maybe another 3-4 days also will add it. That's, but at the time, for the time being, 2 months, 60 days approximately is our plan. Okay, right. Chalo. See, first I would like to go with, in my sequence, I have one sequence. Let me go in the same sequence. Why do I prefer this sequence? Because one standard to another standard is highly linked. Okay, so if you are going in this sequence, you'll feel comfortable, correct? But still, there will be something beyond it will happen, but that I'll explain you in the middle also, right? So before going to that, yeah, the first very basic things, let me start. Okay, very basics. I'll not take too much of time. Okay, but yes, I'll need to touch upon some basic points. Right. Tell me, you will be able to tell obviously very easily. What is the complete set of financial statements, my dear? What are the complete set of financial statement? First one, what do you say? That is balance sheet. Next is profit and loss and OCI, other comprehensive income statement. Or put together, what do we call? Total comprehensive, that statement of P&L, that is total comprehensive income, a statement of total comprehensive income. Okay, na? Right. So that is second. What about the third one? CFS, cash flow statement. And next, fourth one, statement of changes in equity, SOCIE. Okay, na? Then fifth one is what? Obviously the notes to financial statements, correct, which is including significant accounting or material accounting policies, what you call, right? So that is going to be part of it. Perfect. Second point. Next, what is the comparative set, my dear? Comparative sets. Yeah, how many years do you present it? Correct. What is that? Minimum 2 years. Correct. Na? Minimum 2. That is obviously current year. The next one is equal to previous year information will provide. correct? But is there any exception? Yes, there is an exception. What is the exception? Right, under 3 circumstances. What is that? Under 3, I can say 4 circumstances. Under 4 circumstances, we need to present the third balance sheet. Can I say? Right. What is third balance sheet? That is nothing but previous year ka opening balance sheet. Previous year ka opening balance sheet you are supposed to present. What are the 4 circumstances? Any idea? First adoption. Yes, that is first adoption. In case of first adoption, this is coming out of 101 Ind AS requirement of 101. Correct. Now, second one is what? Second, third, fourth. All these 3 things come out of Ind AS 8. Right? Ind AS 8. Right. So, what is the first one? This is retrospective application. Correct? Na? What is this? Retrospective application of accounting policy. Retrospective application of accounting policy. Yes. There you are supposed to present the third balance sheet mandatorily. Right. Is it that's all? No, not that's all. Retrospective restatement, I will say. Retrospective restatement. Yeah. When do you do retrospective restatement? That is nothing but prior year error or prior period error. Yes. If you are doing an error, if you have done an error in the last year or immediately that before year or any time in the past, if you are trying, you have to restate the financial statements as per Ind AS 8, Ind AS 1, both. It will talk about Ind AS 1 and 8, obviously. Okay, right. So there you are supposed to present third balance sheet. Next, what is that? Next, reclassification. What do you say? Reclassifications. Reclassification which is impacting the balance sheet basically. Because of the reclassification, if it is impacting the balance sheet, sir, it is impacting only profit and loss statement, then you don't need to correct. It is impacting only profit and loss statement. What do we mean by only P&L? Because of the reclassification, in the sense the finance cost is going to become other operating expenditure, or other operating expenditure is going to become, I mean, it is an income or expenditure within the profit and loss statement. My total PAT, profit after tax, is not going to change, so then my equity is not going to change. So just a reclassification within the P&L, only P&L, no need of third balance sheet. It is not necessary. You don't need to give third balance sheet, only profit and loss statement. I mean, third balance sheet is not required. I mean, 2 balance sheets as usual. Current year, previous year information if you provide, that is more than sufficient. Is this clear? Correct. Next. And again, OCI, you are aware of this. Other comprehensive income statement. Statement of other right. Where do we present? Where do you present? Under IFRS. We have got under IFRS, not as per Ind AS. Under IFRS, there are choices. What is the choice? You can show P&L as one separate statement in one separate page. Other comprehensive income separate statement, separate page mein you can give. Okay, that is IFRS mein you have got the choice. Okay, but here no choice. Here in Ind AS we have carve out. I don't want to take this choice under Ind AS. So what is that? You have to give first to P&L you have to provide, and immediately below, correct? Immediately below, OCI statement also mandatorily you are supposed to provide. Have you seen the financial statements? Ind AS financial statements of any company randomly? Right? You should see actually. Okay, right. Anyhow, this I have taken it for the purpose of some other class purpose. Okay. Yeah. So if you see this is Reliance Company ka 31st March 2020-25. Okay, standalone financial statement, statement of profit and loss, correct? Immediately other comprehensive income. Okay, this is your P&L. This is your P&L statement. Okay, let's say this is equal to A, this is equal to B, this is equal to A plus B. 35,262 minus 541 will come to 34,721. It's like that. So immediately below that is what I was trying to mention. Correct, na? Right. First P&L information should come. Immediately OCI, other comprehensive income, should come. Okay, that's how total comprehensive income. What is this called? Total comprehensive income. Okay, total comprehensive income is nothing but P&L plus other comprehensive income data is going to be there. right? Here also if you observe this plus this, right? Yeah, this 1 and 3, that is I am going to explain. The other comprehensive income. Why other comprehensive income? Actually, income definition, correct? Now, if you look at income definition is like what? Do you remember by any chance? Income definition is increase in assets or decrease in liability, correct? Now, ultimately increase in equity. What is equity? Equity is nothing but owner's fund. Okay, owner's fund. In simple words, I can say equity share capital plus reserves and surplus is equal to my equity in simple words. Okay, just to make you understand. Hope you understand. Right. What is happening, my dear? Increase in the assets or okay or decrease in the liability, ultimately leading to what? Increase in the equity should take place. Under that circumstance, that is called income. But that's all is the definition. Okay. But it includes what? It includes realized income and unrealized income. Both. It includes realized and unrealized income. Both are there. Are you getting my point? Right. So revaluation gain, I got it. Is it income? Yes, it is income. Correct. Now it is going to revaluation reserve. Revaluation reserve is increasing, is it? And asset, yes, my fixed asset is increasing, is it? Agree na? Right. Is it income? Yes, it is income. Right. So in the profit and loss statement, we do not disclose every kind of income. Every income I said, but income does not route through the profit and loss statement. Income can be routed through OCI. Income will be how to be routed through. Where should I take that income? That is decided by the standard, not by the definition. Hope you understand. Right. So there are some kinds of income which will not be routed through profit and loss statement alone. Example, one more example, if I say FCTR, foreign currency translation reserve. Foreign currency translation reserve will not be transferred to P&L. Correct na? It will be going to reserve account. Is it an income? Yes. Obviously my assets are going up. That's why our difference amount only, correct na? Net asset difference amount only, I'll keep it under FCTR, reserves and surplus, I'll keep it. Right. So like this, there are so many other incomes which are not given or presented to the members. That is the reason we wanted to show such kind of reserves below the profit and loss statement under the head other comprehensive income. But here also other comprehensive income is going to be classified into two types. Okay, right. Type number 1. What is the type number 1? Other comprehensive income, I mean the items which will be subsequently routed to P&L. Subsequently, correct na? Subsequently, what do I say? Subsequently classified, reclassified. Subsequently reclassified. Reclassified to what? Subsequently reclassified to profit and loss, and it will never be reclassified. Yes, never be reclassified. Yes, never be reclassified to P&L. Yeah. Example, simple example here, if I say subsequently transferred to P&L is FCTR. Subsequently classified to P&L is FCTR. What is that? FCTR arises when you have a subsidiary or when you have an associate or joint venture or a branch at least in the foreign country. Got it? Then FCTR reserve will come. Right. So FCTR, when it is arising, it will go to FCTR reserve. Reserves and surplus, it will be presented. Later, when you sell the subsidiary, what did I say? When you sell the stake in the subsidiary or branch or whatever associate or joint venture, that time, what are we supposed to do? This FCTR, the FCTR, suppose I have only one branch, foreign branch, FCTR is arising, that branch I sold it to some other party. Now, entire FCTR amount will be transferred to P&L. So, via P&L, it will go to retained earnings. Hope you understand. It will not be shifted to the retained earnings in the statement of changes in equity. It will not go there. It will go to P&L. Via P&L, I said. Via P&L, it will be transferred to P&L. From P&L, it will go to retained earnings. That is FCTR example. Here, what is? It will never be reclassified to profit and loss. That is nothing but revaluation reserve example. What did I say? Revaluation reserve. Revaluation reserve, that is specific asset. It was earlier revalued. Now you sold off. You sold off means if there was a revaluation reserve pertaining to that specific asset, that will be shifted to retained earning in the statement of changes in, right. This is what this is routed through. Where do you route it through? SOCIE. It will not touch profit and loss. It will not touch profit and loss statement. Are you getting my point? Yeah, here it is. Here how does it happens? It is via only profit and loss it is going to touch. Okay, right. It happens always by touching the profit and loss here, this case. And one more is also there, my dear. Example, maybe if it is a equity instrument, what do I say? Equity instrument which is classified as FETOCI. Kya bola? It is equity instrument. If it is classified as FETOCI, it will never touch profit and loss statement. It will be always routed through the SOCIE only. Okay, but if it is a debt instrument, kya bola? If it is a debt instrument and if it is classified as FETOCI, then yes, it will be touching the profit and loss statement. That is the difference. Not every FETOCI instrument will happen like this. Equity instrument routed through equity instrument classified as FETOCI, concept is different. A debt instrument classified as FETOCI, concept is different. Hope it is clear, right? So that is the importance of OCI. OCI, other income only, but it is not routed, which is not routed through profit and loss statement, is going through the OCI for the presentation purpose. Okay, right. Any other concepts are also, many other concepts are there. Let's say example, what do you say? Actuarial gain or loss. What is this? Actuarial gain or losses. Yeah, this which is arising from Ind AS 19. Actual gain or loss. That is remeasurement of defined benefit plan, something like that we will write. But end of the day meaning is that actual gain or loss. This also will be routed, it will never be routed through profit and loss statement. It will directly transfer it to a separate reserve or to a retained earning. We have two options. We can do it. Okay, right. This is one basic. Next, one more basic, right? Any questions so far? Right? If you have a small question, you feel free to ask. That's better always. Okay, instead of asking towards the end, I'll give little time whenever you can raise hand, right? And you can start speaking. Fine. Hello. Next basic is with respect to two financial instruments. Let me say financial instrument. Okay, financial instruments. Yes, which is nothing but Ind AS 109. Correct na? Next 107 and 32. So it is a combination of all the three standards. Okay, 32 talks about what? 32 talks about financial instrument presentation. What does it talk? Presentation of financial instruments. Okay, not even disclosures. This is talking about disclosure. Right. Rest all recognition, little bit of not presentation is very light. Recognition, impairment, and everything is going to be discussed by 109. 109 is obviously very big standard. Okay. What is a financial instrument? Financial instrument is first thing, it is a contract. Contract means obviously there will be two parties. Correct now? Party number one, party number two. A contract which gives rise to what is it gives rise to? A financial asset to party number one. Correct now? And right, and financial liability or equity, to party number two. Right, my company issued equity share capital to you. What have I issued? Equity share capital. You purchased. It is an investment to you. For you, it is a financial asset. Correct? I have issued what? Equity share capital. That is nothing but it is an equity to my company. So is it a contract? Yes, it is a contract. I am the owner. Right? Yes, it is a contractual arrangement. So for one party co financial asset, another party co equity. Or I have issued debentures to you. For you, investment in debentures, it is a financial asset. And for me, it is, yes, I have an obligation to repay you. It is a financial liability to other party. Okay, right. Next important point, financial asset. If financial asset or financial liability, Sir, recognition, I will say. Recognition. When are we supposed to recognize? Right. This is what am I doing right now is just a basic. Because these words, whenever I get into any standard, like say if I go to Ind AS 20, government has given a loan to you. Loan is another way financial liability. Correct na? Interest free loan given. Interest free portion only government grant. But loan is a loan, financial liability. So do you need to have some knowledge about Ind AS 109? You need to have. If you don't have, then how do you get the clarity on that point? So that's why little introduction I am giving. This is not, I am not doing with Ind AS 109 now. Ind AS 109 maybe tomorrow or day after we'll plan. Okay. Obviously, more maybe like some 2.5 2 hours plus only we'll discuss only Ind AS 109 because a lot in that. But exam oriented will go, right? Not about to show my knowledge, right? That to show my knowledge 20 hours not sufficient, right? Chalo. So recognition may what will happen, sir? Initial recognition and subsequent is on the balance sheet date. Yeah, subsequent, that is nothing but on the balance sheet date what are you going to do with it? Initially, any idea, my dear? Initially, how do you show? Everything, both financial, this is whatever I am talking, that is financial asset and financial liability, both will be at fair market value or fair value, right? Fair value generally, my dear, generally we'll say it is a transaction price. Fair value, assume it is a transaction price only all the time, okay? But not necessarily every time it will happen at transaction value. If it is not taking place at arm's length transaction, then obviously you have to determine the fair value. But it's okay. Fair market value we will be initially measuring. Done. Sir, it is not happening at fair value. Then what should I do? There is a difference. Correct na? There is a difference. Our difference ko what should I do? I mean to say, simple example. We gave loan. Okay, we gave loan. Loan to whom, sir? Loan to employees. Yeah, loan to employees. What is some home loan we gave? Possible. Or car loan you gave? Very much possible. How much money? Say 10 lakh rupees. Simple example. At what rate? At 2% I am giving. Correct. Is it arm's length? Obviously not arm's length. Sir, what is the market rate? Any bank, correct? Any bank, go to ICICI, HDFC or any bank you go. What is the rate of interest? Say, just for understanding, 10% is my example. If you take any home loan or car loan, whatever loan, 10% they will charge. But wherein my company is giving a loan of 2%. Correct? Right. So, what do we say? Now, 10 lakh rupees, what do I say? To financial liability, that is equal to loan. Sorry, asset for me, right? Yeah. I gave a loan. So, it is a financial asset. Loans and advance or whatever loan given to employees. Okay. Say example 9 lakh rupees, I discounted and I got some number. This is present value number. Correct. But today, what is that I gave money to cash or bank? That is equal to 10 lakh rupees. This is what given. What I am talking is this difference. This is the balancing figure of 1 lakh rupees. What should I do? Prepaid expense. Okay. If there is a loan means I'll give you just for information 5 years karke I'll keep it. Right. So you will say it is a prepaid expenditure or prepaid asset, something like that. This is an asset you are trying to tell. Agree? Why? How do you say that benefit is for 5 years? Where are you recovering? You will recover the money, but not the principal and interest at the 2% only he will recover. Has he given a promise that I will work 2 hours extra? You understood what I am asking? Employee is giving any promise that you gave 10 lakh rupees, so 1 hour extra I will work daily. No. Correct. Every cadre employee will be giving it, irrespective of his performance. There is no guarantee whether he will perform or not. Correct. No? So then where is the guarantee? Actually, there is no guarantee. That should have been charged to P&L. Before going to that, I'll tell you. First thing, question is first what should I ask? This one you are supposed to ask. How is that correct? Now, how did we calculate? How did we calculate fair market value? Question mark. Right? For this, you need to have some little bit of Ind AS 113 ka basic knowledge is required. Okay, right. Sir, I have applied level 1 input. Level 1 inputs I have taken. What I have taken, my dear? Level 1 input I have taken. Or no, sir, I have not taken level 1. Level 2 or level 3 valuation I have done it. Level 1 means what, my dear? Level 1 means straight away available in the market. Okay, observable input we can call. What is it, the word, correct word, what do we say? Observable. Yes, observable inputs. Right away market may available. If it is so, then the difference amount, whatever I am telling, that should directly be charged to profit and loss statement as per the standard. You understand? Right, all the time it is not going to be prepaid asset. It depends upon how the valuation, fair market value of the asset or liability you determine. If it is through the level 1 input, then that number should be charged to profit and loss. Right, here, no sir, yeah, here what did I do? Cash flows I have taken, correct? Now, how is it going to pay cash flow for next 5 years? First year, second year, monthly cash flows I must have taken. I will be discounting using the 10% rate. That's why I got the fair market value of 9 lakh rupees. Agree, yeah? That's how we'll get. We don't need to go to market. Mein kaisa milega 2% loan ka? You will not get, readily not available. Under that circumstance, then does it satisfy asset definition? That is the next question. What is that question? Does it satisfy asset definition? Yes. If you say yes, then it is an asset. Prepaid asset, what you mean to say? If I say no, correct na, then this supposed to be charged to profit and loss statement. Supposed to be charged to P&L. Right. But you told prepaid expenditure in one of the questions of ICAI in the past examination, they have transferred to prepaid asset only they have transferred. Even though that is 100% wrong, you still follow ICAI only. Practically don't follow. In examination may follow karo. Because you can't argue with them. Correct? Now, they don't give you a chance also. I hope you understood. Right. From exam point of view, I also have to teach you. If it is any company comes and asks me, no, I will not suggest them this. Which employee is giving you guarantee that, correct na? Where is the probability that he will work? He may not work, he may underperform also during the 5 years time. Then what do you do? Then why should I keep it? Simply like that. Not necessary. Okay. There is a lot of professional judgments are involved here. Right. Since ICAI mein one of the exam mein aisa de diya, that's why I am also suggesting in the exam hall you transfer it to asset only, prepaid asset only you transfer. But otherwise this is the criteria of Ind AS 109. Have you understood? You are aware? If you are already aware, fine. Otherwise, I think you must be copying. Okay, right. I can, but my handwriting will be like this only. Okay, better you write it in your handwriting. Fine. Chalo. So that is the first point. So first point is what, my dear? Initially, you are supposed to recognize it at fair market value. Correct. A fair market value, when you measure it, generally fair market value is equal to transaction price, but not all the time. If it is not at arm's length price, you have to determine the fair market value. How to determine fair market value? One has to refer 113. Correct. 113 may level 1 inputs or level 2 or level 3 inputs may something you are supposed to look at. Right. Some information ka fair market value readily available. Suppose something listed company share, listed company debentures. Debentures are also listed. Mutual funds valuation, all are available publicly. Correct na? You don't correct na? Any options also, but subject to the which options you have taken. If it is like as per the market 3 months option only, then it is available readily. Otherwise, it will not be available. Okay, right. So how are you measuring? Readily available, level 1. Not readily available. We need to tweak little bit. We need to get some data and we need to comparable numbers. You have to take it and we need to tweak. Then level 2 or level 3 it may fall. Under level 2, level 3, if it is falling, then does it satisfy asset definition? Are you sure that probable future economic benefits inflow to the company? Yes. Then you take it to capitalize it, means asset. No, if you do not, then you should be charged to P&L. But if it is through via level 1 input, fair market value is readily available, that time no, don't tell me by mistake also, correct na? That time if they say, even ICAI say, I will not agree, then because it is wrong, obviously your ICAI cannot be opposite to Ind AS 109, right? If it is what level 1 input में आया तो difference has to be charged to P&L, you don't have a choice. Hope you understand. Yeah, loan to employee, obviously not level 1, so it is under level 2 or level 3, so it can be done under, yes, asset or, yeah, argument can happen. My argument is, where is the guarantee, where is the probability that employee will continue or not? No guarantee. Do you have control on that guy? No. But I agree, when they leave they have to repay the loan and go. That point I agree, but there is no guarantee that he is going to work for you, right? That's why I would like to charge it to P&L, right? But I say textbook mein, I told no, some of the one exam mein they wrote it as prepaid asset. So you also please follow ICAI, don't try to take any risk on this. Okay, next, the subsequent measurement of financial instrument. Subsequent measurement depends upon, correct na? Yeah, little bit of 109 also I am explaining, relevant this is, because without this I cannot go to deeper of the any other standard, that is the only reason. Okay, right. So if I say financial asset, FA, financial asset here, financial asset subsequently on balance sheet date, how many types of classification can happen? It can fall under 3 circumstances, correct na? First of all, what is the basis for this, my dear? What is the basis? Any idea? There are 2 tests, correct na? 2 tests. What is that one test? First test is called business model, correct na? What is this? What is the business model? Yeah, second test is what, my dear? Second test is SPPI test, solely payment of principal and interest, solely payment of principal and interest test. Okay, right. So whether the instrument is of the instrument, whatever the cash flows are expected to happen, is it just a payment of principal and interest? What are you going to collect? Because we are on the asset side. Asset to collection. As a collection is just a principal collection and interest collection, is it happening, or is it something more happening? Got it? Right. So sir, if I say business model, what do I tell? Business model. Under business model, right, let us spend little bit of time so we can reduce this concept when I am discussing 109, correct na? Right. So model number 1, model number 2, model number 3. Okay. First, what is the first model number 1? I wanted to get the contractual cash flows till the maturity. What did I say, my dear? We wanted to receive or get contractual, what do I say? Contractual cash flows till maturity. Yes, till maturity if I am going to get, that is plus, sir, I satisfy SPPI test, means instrument is a plain debt. Kya bola? SPPI test means what, my dear? SPPI test means, simple words में to put it, it is just a plain debt instrument. Debt, loan दे दिया, what do I get? Principal I'll get back, interest I'll get back, nothing else. It is not a convertible debenture, it is not a convertible preference share, it doesn't have any return linked to market, linked to commodity, linked to something nonsense in the world. No, it is just plain debt. If it is so, if you satisfy, what is the first one? You should have intention to, or as per your business plan, actually correctly speaking, as per the business strategy, your CFO has kept the money aside, and where his intention is not to withdraw in between, not to cancel in between, wanted to get the contractual cash flows till the maturity. If the instrument is life is 5 years, at the end of the till 5 years I will get the money, as the other company gives me I'll take it. Okay, right. It doesn't mean that, sir, exceptional circumstance, that company is about to die, I got information, that's why I'm selling it, that is okay, that exceptional circumstances are fine. Otherwise my strategy is telling to collect the contractual cash flows over the maturity, okay na, over the till lifetime. If you satisfy both, my dear, then you are supposed to follow amortized cost method. Which method? Amortized cost method. Fine, sir. Yes. Then what about the second bit? Second one is what? We do withdraw, correct na? We do withdraw as per the strategy. Yes, as per the strategy. Withdraw strategy, correct. This is before maturity. Yes, before maturity. Yeah, plus same SPPI test also I am going to satisfy. What is this? Maturity, say example, I purchased one debenture instrument or I gave a loan to some other company. Okay, what is the period? Period is 6 years of time. But I know I am investing in 6 years. I have my strategy. I am going to start one plant and machinery maybe in 3 years time or 4 years time. I know from the day one itself I am going to withdraw my money, correct? I am going to sell this instrument or liquidate this instrument and I'll take back my cash flows. Are you getting my point? Right. It is as per the strategy. It is not like all of a sudden. Not for the gains, not for the losses, nothing. It is as per the strategy. You should be withdrawing before the maturity period, correct? Because you have your own plans, your budgets you have as per that, plus SPPI test also if it satisfies, that means it's a plain instrument. Then it will be classified as FVTOCI, fair value through other comprehensive income, correct? Here a simple word I will say, there is no strategy, correct? Yeah, I am investing somewhere. What is the strategy? Nothing, no strategy. No strategy in the sense what? Correct. I'll say I'll get gain in some time. Whenever I want, I'll withdraw. Correct. There is no, there is no wish backside. I'll do whatever I want, whenever I feel, whatever is, correct. That only I'm going to do it. When there is no strategy, then only it is going to be FVT profit and loss, FVTPL, fair value through profit and loss statement, it will be transferred. Agreed? Right. So, correctly speaking, my dear, actually as per the correct classification, a debt can fit here. Debt only can fit. Agree? Correct. Na? Because when I speak about the contractual cash flow word will come only for the debt. If it is an equity instrument, where is the contractual cash flow? Who has given you contract? Nobody has given. Correct. Na? Anyway, do you get any dividend? Do you get principal back? Nothing will come back. Na? So, contractual cash flow word will fit only for the debt. So, if it is a debt instrument, my dear, if it is a debt instrument, it can be amortized cost, it can be FVT OCI, it can be FVT PL, because it satisfies SPPI test and there is a contractual things are there. As per my strategy, it may fit under amortized cost or FVT OCI or FVT PL. A debt can fit, correct? But sir, if it is an equity instrument, kya bola? If it is equity instrument, where is the amortized cost? How can you do amortized cost? Do you have any contractual cash flows? Actually speaking, no, these two cannot fit. Only FVTPL will fit. Where it can fit? FVTPL. But there is one more exception. What is that? Exception. What is the exception, sir? Yeah, what is the exception? If it is an equity instrument, kya bola? If it is an equity instrument, yeah, equity instrument, we can tick this. This is irrevocable. Kya bola? Irrevocable. It is a choice, purely management decision. Management decision. Management can do what? What can they say? They can say, no, even though equity instrument does not satisfy, I can classify it as FVT OCI. I can classify it as FVT OCI, irrevocable at initial. At initial recognition, at the time of first time when you are recognizing itself, you should take a call saying that no, I will put it under FVT OCI. Irrevocable. Irrevocable in the sense, it no reclassification further. No reclassification. Kya bola? No reclassification further. Means what? It cannot jump to E side, impossible. It cannot jump to E side. Sir, at least I can go to FVTPL. No. It is classified as FVT OCI. It cannot go back to anywhere else. Understood? From here you can make out one small line. What is that one line? If it is a debt instrument, if it is a debt instrument, It is for only debt instrument, whatever you have studied in, correct na, whatever you have studied in reclassification of financial assets may applicable. Reclassification in the sense it was classified as amortized cost to FVTPL or FVTPL to FVTOCI or any of these three buckets may jumping from here to here, here to here, or here to here, here to there, or from directly there. Are you getting my point? Possible for what? Debt instrument. Otherwise, how will it happen? Equity instrument it will never fit under amortized cost, it will never fit under FVTOCI. It will fit under only, correct. So it cannot jump only E side. No, sir. FET was irrevocable option already told. Understood? So that's why FET-OCI to FET-OPL also not possible. FETPL to FET-OCI also not possible. The entire subject of reclassification of financial asset applicable only to debt instruments, not to equity instruments. Is that clear? I hope you understood. Right? So that's what reclassification is the link for, classification is the link for the reclassification. Yeah, you have a question? Entire class not required, it is selective. Instrument by instrument you can choose, not necessary. Like say I have 4 instruments, one is Reliance company share may hai, one another may hai, one other may hai, example whatever you feel. You can choose that I wanted to put it on FVT-OCI. Selectively you can do it. Not necessarily that all the equity instruments should be FVT-OCI, all the equity instruments should be at FVTPL. Okay, but what I am telling, once you classify as FVT-OCI, lifetime it has to be, till that instrument is continued with you, it has to be at FVT-OCI. It cannot be shifted to FVTPL. I think that's clear. Right. Any other question? Fine. Yeah. So this is with respect to what? Financial asset. Correct. Amortized cost means what, my dear? First of all, amortized cost. Amortized cost means, any idea? Amortized cost method. Initial recognition will be at fair value. Very nice. Yeah. Initial recognition at fair market value. Done. Correct. So first point is here, na, you wanted to hold it till the maturity. Correct. Na? So and that whatever you want to touch, you wanted to touch based on the contractual cash flow. Contract में monthly paisa आएगा, monthly ले लेगा. Correct. Na? Our principal will come at the fifth year only. Okay, as per the contract. That's not decided by me or you. Contract में क्या decided? Contract number when it will come I know. Correct na? Exactly. What are you supposed to do? You are to go by the EIR or ERA, whatever, effective interest rate method, which is nothing but what, my dear? IRR. Correct na? IRR. Right. In Excel में we can apply goal seek method. Yeah, have you heard this? CK, goal seek. Under data, if you go, Excel you know na, obviously. Correct na? Under data, if you go, there is an option called goal seek. One option will be there. गोल सी का ऑप्शन में एग्जैक्टली परफेक्ट रेट वेलकम. ओके, ये आईपैड में डिफिकल्ट, लैपटॉप होना. करेक्ट. इफ यू हैव लैपटॉप में आई कैन शो इट लेटर आफ्टर द क्लास. इफ यू आस्क, आई कैन रिमाइंड मी, आई विल शो इट टू यू. It's easy to calculate. Got it? Yeah. So we just use this goal seek. This is the best method available tool. Means by using which rate exactly my cash flows will come to zero. It will come. It will calculate and get you in few seconds. Mein correct number IRR will come. Okay, right. So that is IRR basis you are supposed to calculate. Correct. This IRR, whatever the interest, that is effective rate of interest. Correct na? Right. I'm telling you overall. See, end of the day, no. When you go to any company, correct na? Once you say you are chartered, once you say you are done with FR paper, the expectations of the other people will be very high. You know all Ind AS karke, a feeling will be there. Whether you know, do not know, they will feel like that. Nothing wrong. We cannot stop them, and We only have to upgrade ourselves. Correct. Na? EIR, whatever the number comes, that depending upon this E number, your Ind AS 23 is linked. Correct. Ind AS 23 is what? Borrowing cost. This is also borrowing cost only, na? Correct, na? Whether it should be capitalized, whether it should be correct, na? Whether it should be capitalized or whether it should be charged to P&L as a finance cost. Understood my point? Yeah, right. So if I want to charge to P&L, which number I should charge? Effective rate of interest I should charge. No, sir. I want to capitalize it. Which number I should capitalize? Not the interest what you pay in cash or something. No, no, no. Effective rate of interest only, this number only should be capitalized if it is a qualifying asset as per Ind AS 23. Hope you understand. I mean to say, in simple words, to make it so plain, suppose I have taken a loan. Yeah, we have taken a loan. Yes, financial liability also amortized cost. So that amortized cost, financial asset amortized cost are not different. Both are in the same line, 100% same line. Yeah. So and I am doing what? I am constructing one building for my sake. What am I doing? Constructing a building. Correct na? This coupon rate, what is the coupon rate, sir? Coupon rate may be 10%. But my EIR, yeah, EIR is equal to 11% has come. Because I have paid processing fees, brokerage, that this nonsense I paid, so it has come to 11%. Okay na? Now, as per the 11%, you assume some X number ko, whatever the amount you have paid. Correct na? E number has come. Right. This number only will be capitalized as per Ind AS 23. Have you understood my point exactly? It is not a coupon rate 10% is going to be done, right? It is not 10% coupon rate will be done. It is effective rate of interest only will be capitalized or it will be charged to profit and loss statement. Is this line clear? You have clarity? Right, that is more important. Right, chalo, we'll go back. Right, that is amortized cost. The amortized cost may in your questions may now, I mean conceptually they have given good, but practically na, you have to apply your knowledge. Right, different names you will listen when you go to a company, especially when you go to NBFC na, they will be taking number of different loans from different party. Different words will come, not just brokerage or processing fees. Other than these two, number of names will come. Everywhere you need to apply your knowledge. Shall I use it for amortized cost or not? Or should it be charged immediately? Right? And again, loan given also, NBFC does give loan. Correct na? That time also they will be charging processing fees. They will be charging, so many things will be there. So which are all the elements? Because 10 items will be there. Which element I should take it under amortized cost or which should not? But that much is not required for exam. They will give very simple and clear straight example. Actually, they do give very straight example, not too much hi-fi. Fine, right? Next, FVT-OCI. Yeah, FVT-OCI. This is something I want to ask you question. Fair value through profit and loss, revenue through OCI. Correct. An equity instrument also can be sitting under FVT-OCI subject to the irrevocable initial option taken by the company. Agreed? Right. What about the dividend? Whenever a dividend you receive, dividend, or if it is a debt instrument, you will receive the interest also. That should go to profit and loss statement only. Okay. Fair value change only, fair value of the main instrument should go to OCI, not the any return you are getting. These two are what, my dear? This is return. Correct. Now, return on the instrument. This is return on the instrument. Return should go to P&LA. Only fair value fluctuation of that instrument should go to OCI. Correct? Right. One point which I believe, suppose if it is a debt instrument, amma. Yeah, mostly I expect you will answer wrong. Prove me wrong. Okay, right. Fine. If it is a debt instrument, fine. What do you do first? It is classified as FVT-OCI. We are under the discussion of FVT-OCI. Tell me now, what do you do? There will be interest also. How do you calculate interest? Interest के लिए do you use the coupon rate or EIR? But classification is under not amortized cost. Classification is, I am just reminding once again. Tell me, you understood my question? It is if a debt instrument can be classified anywhere, it will fit under amortized cost, it will fit under OCI and P&L, both FETPL, FET, OCI. Agree na? Now, इसको interest calculate करना ना, that EIR only should be calculated or normal coupon rate में EIR calculate करके then fair value fluctuation will transfer it to OCI. Same, exactly, you are right. It is not a coupon rate. First, what are you supposed to do? Step number 1, EIR as amortized cost. After calculating amortized cost, your number will come. Correct na? A number, then you compare it with. Second thing is what? Second thing is compare with fair market value. Right. Now, E number will go to my OCI. Correct na? E number will go to your profit and loss or capitalization as per the requirement. Agree? Very nice. Right. But what do you do next year? Next year, what are you supposed to do? Next year, first, you E number go reverse it. First thing, what you are supposed to do? On 1/4, 31st March, you pass the journal entry. Fair value number will come. Are you getting my point? 1/4, you reverse the fair value difference. Whatever 31st March you will pass entry, 1st April you reverse it. Then what is you brought it to which level? Amortized cost level ko brought it. Agreed? Are you following me? Right. On 31st March what you will do? Again amortized, already beginning में amortized cost को लेके आए आप. From amortized cost, interest rate, EIR interest rate you apply. Whatever the cash received or whatever it is, plus or minus को कर दो. Then number will come. Now again compare with the fair market value. Now E number, take it to OCI. I hope you understand. If you immediately reverse it, no, headache will not be there. If you don't reverse, the problem, so many doubts will come. You understood what I said? What did I say? Fair value transferred to OCI. On 1/4 you reverse it. 31st March you pass it to OCI. 1/4 you reverse it to OCI itself. OCI itself, same way. Correct na? Then anyhow net effect will come on 31st March. E reversal will be there. Current year may be gain or loss may be there. Correct na? Net impact only will go to OCI once again. That is the best way, simple way to understand and tackle. Okay. Right. Next, FETPL. Yes. Right away. Correct na? Any only fair market value change of the instrument plus or minus will be transferred to profit and loss statement. Okay, it will be transferred to P&L. Agree? Alright, there is not, I mean obviously the interest amount, dividend amount, anything is there. Anyhow it will be transferred to profit and loss. Here there is no serious matter. Correct? So we are done with little bit of what is that? Financial asset wala done. What about financial liability? Financial liability. In case of financial liability, all financial liabilities are generally at amortized cost. What do you say? First sentence will be like this only. First sentence will be what we will say, all the financial liabilities will follow amortized cost. First line aa jayega. Subject to, again, exception. Exception, yes. Exception may few. Yeah, exception may few. What will happen, sir? Few may be FETPL. What will happen? Fair value through P&L. Why? Example, derivative instrument. Correct na? One derivative instrument, you have taken option. It is a liability situation. You are going to lose. You cannot follow amortized cost for that. Correct na? So what are you supposed to do? Yes, it is supposed to be classified as FETPL. Or, correct na? Yes, that is one. Or sometime what will happen? Any contingent liability which is arising from the 103 business combination. Contingent consideration. Kya bolo? Contingent consideration. That is also supposed to be fair valued if it is going to be classified as a financial liability. We are under financial liability. Okay. So this is a contingent consideration. What do I say? Contingent consideration. Yes, contingent consideration which is payable. If it is classified as a financial liability, then you will be following what? Fair market value. You will remeasure it and transfer to profit and loss statement. Will not do amortization cost. Next, in case of derecognition of financial asset, what do I say? Derecognition of financial asset. What is this derecognition of financial asset? Very simple example to catch. So there is a what is the debtor will tell trade receivable, but our language debtor I will use it. Okay, trade receivable is 100. Assume instead of debtors I will say BR, I will use it. What do I use, my dear? BR, correct na? Bills receivable. So if it is a bills receivable, what are we supposed to do, my dear? We discounted, assume EBR is discounted. क्या किया? Discount किया. Normally what is the journal entry will pass? Discounted, you got say 100 rupees only you got. Generally you will never get. Interest you will cut. Simply. What is the entry for this? Bills receivable discounted with the banker. This is not a new transaction to anybody, correct na? Bank debit to be 100 rupees only you take it na, for the time being I said. This is okay? Anybody has an alternative answer? Anybody has an alternative answer? Right? This is not okay. Why not okay? Bills receivable, first of all, BR is a financial asset or not? Correct na? It's a financial asset. Financial asset, you're what are you doing? Derecognizing. You're taking it out, right? But the risks and rewards related to the asset are with you only still? Still with you. Where have you lost it? Correct na? If the debtor has not paid, banker will come and catch me only na? Agree or not? Am I liable to pay the money to the banker? Yes, and I should go and fight with the debtor. So this is not okay. It doesn't fit under the derecognition. That's why what should I record journal entry? You have received the bank, correct now, whatever the amount 98 rupees only you got it, that will be recognized as financial liability. So instead of taking it out, financial liability 98 should be there. Hello, understood? Right. Sir, how do I, this is a financial liability. This is a financial liability. Yeah, this will not be under amortized, not necessarily it should be under amortized cost. Sir, how do I measure? Subsequently measurement kaisa hona? How is this item is getting measured? Same way this item should be measured. If this I am following FVTPL or FVTOC or something like that, this also has to be same way. Or amortized cost. Okay. So that's why it won't fit under the amortized cost almost. Okay. Derecognition of financial asset which does not fit. Correct na? Which does not fit. Does not fit what? Financial asset का derecognition conditions को derecognition conditions, if it does not fit means it is not derecognition exactly. Under that circumstance, the amount whatever you have received should be recognized as a financial liability rather than derecognizing the financial asset. And whatever the financial liability comes out, how do I measure that one? That should be measured in line with asset. How asset you are measuring, same way you are supposed to measure. And one more, the fourth point is there. Fourth point is what? Any idea? Excellent. Financial guarantee contract, FGC. What is this? Financial guarantee contracts. Okay. Yeah. Financial. Yeah. Financial guarantee contract. Financial guarantee contract means you gave a guarantee. Correct. A financial guarantee. If the other party does not pay, make the payment, then you will pay. Correct na? That is not a contingent liability anymore. That is a liability. You are supposed to show it as a liability. Correct. Initially it will be at present value. There is no change. We are under what? Subsequent. Correct na? Where are we now? Under subsequent measurement mein, what are you supposed to do? First thing is amortized amount. Amortized amount, or second thing is I will say simply ECL, expected credit loss, whichever is higher. our number is supposed to be measured. We'll try to spend what is this financial guarantee. I have seen many financial guarantee contracts for so many companies. Okay, this practical measurements also we have seen. So we can spend some time when we exactly do deep dive in 109. Okay, right. This is slightly about financial asset or financial liability ka initial recognition, subsequent measurement. Okay, right. So this is very important to get into the standards basically. Fine. One quick basics of 109, very much important. Without 109, I mean, without 109 knowledge, you cannot get into, I mean, we except maybe like one or two standards like IAS 16, day 16 or something like that we can look at. But otherwise, everywhere linking will be there with 109. That's why 109 may what, I mean, if you see only one leg of journal entry, what about the other one? Correct. Now, when you think both, when you want to pass journal entry, you should be aware of both debit credit. One I know, this I don't know. I know how to deal with this, but I don't know this. That is like incomplete knowledge. Correct. Somewhere a gap ko if you fill it, then it will be beautiful. Right? Chalo yaar. Let's go to our very basic standard. Now I am getting into Ind AS 10. Very simple standard. Correct. Now, events after occurring after reporting date or balance sheet. Events occurring after the reporting date. Yeah. So events occurring after the reporting date. Yes, reporting date is nothing but your balance sheet. Agree? Right. Events means which events? Only significant events. Correct. Na? Only significant events will handle. Right. Reporting date means till which date, my dear? Till board of directors approval date. Agree? Right. Board of directors approval data are what is that? Financials approved by board date, should I take it, or before the board, what do you call this? Suddenly it will not come. The other committee here. Need one more. Audit committee. Is it audit committee day approval? Shall I take it? Only board. Right. Only board. Board means board. That's all. Not audit committee. Correct. Na? Right. They can try in the MCQs to confuse you. Both the dates if they give and they'll put no. Then you will get doubts that time. Before that you get doubt now only and clear it. Its board means board. No other body. Fine. Yeah. Audit committee. Right. This is a very basic standard, my dear, as you are aware. 1.5 page standard. Correctly bare standard 1.5 or 2 page mein data will be there. Nothing else. Right. These events, significant events, right, are going to significant events between which date to which date? This is 31st March 2025. Okay, this is September. That is where board's approval date. Correct. So the events taking place in this period are going to be divided, right? Going to be classified as, correct. What do you classify, my dear? These are adjusting events. Agree? Right. Next is what? Non-adjusting events. Adjusting, non-adjusting event. Okay, right. So when do you say it is an adjusting event? Adjusting means what? There is a condition or situation on the balance sheet date. Correct. Now there should be condition, right, or situation. Situation should exist on the balance sheet date. Right. And the information will give you clarity. Correct. Clarity. Clarity from subsequent data, I should say. Clarity from subsequent information. Yeah. If information, I mean situation only not there. we were not liable to any party, right? If it is not an asset receivable as on 31st March, then it is purely non-adjusting event. I will say here, no situation or condition, no situation or condition on the balance sheet date. I don't have anything, right? What should I do? If it is non-adjusting event, what should I do? If it is non-adjusting item, you will say it is a non-adjusting item. We do not record, do not record in 24-25. We do not record because we are talking about 31st March 25 means 24-25 financial year. We will record next year. Next, for 24-25, do I need to show somewhere? Where? Notes are board. My question clear? Right. Should I disclose? Yes, we will disclose. Are you writing like this in exam? Generally, you will write like non-adjusting event करके लिखेगा stop. No, disclosure also you have to write. Right. If it is material, correct na? If it is material, disclose. Do you disclose under the board's report or do you disclose in the notes? Notes means financial statements. Where should I show? Notes to financials. Sure. Not in the boards. Yeah, you're right. Notes. AS4 talks about board. Why I asked? If you remember AS4 by mistake, the problem comes. Right, that's the only reason. AS4 mein that is board. Okay, but Ind AS mein it is notes. Got it? And again, are you aware that, my dear, which date board of director approval is there? That also you are supposed to disclose in the financial statements. You have to disclose somewhere. Right? Generally, about the company or information about the company immediately below. What is the basis for preparation of financial statements? Heading will come. There, the financial statements are approved on so and so date. Correct? One date also you should mention. Okay, right. That is required as per the standard 10. Which date board of directors have approved the financial statements? You have to disclose it. Okay. If it is adjusting event, nothing. Correct? Na? You will be recording under financial year 24-25. Record, disclose, present, everything. Disclose. I will say everything. Okay. I'll say everything. You are supposed to do as usual. Correct. Whatever the relevant standard says, you have to follow it. Okay. Right. One small question. Yeah. Simple basic question. I'll take you through the standard. Right. There are some exceptions to this rule also. Right. Before that, I'll take you. What about proposed dividend, my dear? Proposed dividend. Proposed dividend for 2024-25. What should I do? Is it adjusting or non-adjusting? Non-adjusting. Why non-adjusting? As on 31st March, we were not liable. We don't have any contractual obligation. Correct. Are we liable to equity shareholders? No, never. So that's why no. Second. Okay. Second bit. Suppose there was negotiation. Negotiation of purchasing. Negotiation to buy, acquire. Okay. Acquire a company or acquire an asset. Okay. But deal is done in the month of April. Yeah. Deal finalized. Yeah. Deal finalized in April. So what should I do? Adjusting or non-adjusting? Negotiations were going on. When? In the month of March. Finalization, deal is done April month. So adjusting or non-adjusting? Non-adjusting. Not adjusting. Okay, next. You received GST notice. Order, demand. Notice you at least. Received. When have you received? Received in April month. Received in April month. Obviously related to previous year. That is 24-25. Whatever it is. Adjusting or non-adjusting? Non-adjusting. because our situation, I mean, when you have not received the notice only as on 31st March, nothing correct. Now, if I have closed the financial statements 10 days before after, correct. Na? I could have closed on 31st March also. 1st April I would have closed. What would I have done? I would have not considered it. Right? So it is going to be non-adjusted. If it is already known dispute as on 31st March, correct. Na? How you know that there is a dispute? Correctly, I mean fair person means you should have recorded already liability. If you already known the dispute is there, to be a conservative, right? If your company is managed, see, knowingly if you are not writing means it is bakra here, correct? Na? Right? You should record the liability, whatever. If it, I don't know that there is some issue, I felt everything, whatever I have filed, all the returns, everything is perfect. I felt it. As on 31st March, I was not aware that there is some issue is there or mistake is there from my side. Then no need to make a provision. Subsequently has come, then that will happen subsequently. Okay, right. So, right, this is a small basic thing. Right, now let's go to the one adjustment. What is this is a carve out. This is a carve out from where? This is a carve out from IAS 10. Yeah, IAS 10, IFRS number. What is a carve out? This is carve out not only with this, that is with IAS 1. E point, no, it is linked to IAS 1 and IAS 10. Both are linked. It's not like I can't take it only for IAS 1. I cannot take it for this. Okay, right. I'll take a question also on this. That is only the question that generally they will asked already in the past. Okay, other than that, the standard is not touched. Indirectly it is touched, otherwise not straight away. Okay, right. See, example, you have taken a loan. Okay, this is 31st March 25. For this loan, they have kept a condition that is called covenants. Covenants are nothing but rules and regulations or conditions. Condition can be, what do you say? Your ROI, return on investment, should be 15% or more. Your debt equity should be, debt should be not crossing more than 75. If it crosses more than 75, that is a problem. I also gave loan. You are taking further loan. Correct, na? And if you close the company, problem for me also. Right? Condition. Some condition they kept. Got it? Right. E conditions, if not satisfied. Suppose example, if not satisfied, as per the loan agreement, lender will get the, what is that? Demand. Correct. Now loan becomes repayable on demand. Repayable on demand. Are you understanding my point? If you do not satisfy, it will become on demand. I mean, earlier loan is what? 10 years. Non-current liability. Now, if you say demand may you are supposed to pay, this will become current liability. Okay. Strictly speaking, suppose in the month of April, assume this is a bank loan. We went to banker, we convinced banker. Okay. Have you satisfied condition first? Not satisfied. Whether banker has a right to ask you immediately repay? Yes, he has a right. And do you have an option to say no? You don't have an option to say no. Correctly speaking, is it a current liability or non-current liability? Current liability. Why current liability? Other party, because we, as per the agreement, we have to satisfy certain condition, not satisfied. Not satisfied, the other party will get a right. Right. His right is an obligation to you. Correct? You have to repay in time. On demand, you are supposed to pay. Subsequently, we went and convinced the banker. Arre, aisa kuch ho gaya. This is because of some extraordinary event. Aisa ho gaya. That's why this our return on investment has come to 14.5%. If you remove that extraordinary event, it will come to 18%. This won't happen. Something we convinced here. Okay, Banco, something you told Kahani convinced. Correct. Correctly speaking, is it a non-adjusting or adjusting? Non-adjusting or adjusting? Financial statements approved in the month of September. Forget about it. Okay, full time is there. Before closure of books, I went to banker. I requested, sir, we have not satisfied due to this reason. Please waive off. Okay, don't ask me. He said, okay, fine, I will not ask you. Right now, correctly speaking, non-adjusting. Why non-adjusting? Because he has forgone his right in the month of April, not as on 31st March. As on 31st March, does he has a right? Yes or no? He has right. So it is current liability in reality. Okay, but even though it is non-adjusting event, our standard Ind AS, what Ind AS takes, it has taken a carve out. What is it taking? Carve out. Carve out le liya. Under carve out, what is happening? We said even though it is non-adjusting, we'll treat it as adjusting. Even though it is non-adjusting, we treat it as adjusting. Means what? If it is, once you say adjusting, means what will happen? Instead of April, it has happened in the month of March only. Karke assumption le lo. If it has happened on March, banker has already forgone. Correct. Now, banker now he has a right to ask only after 10 years. Now, if it is only asking 10 years, then it will become non-current liability. Continue the same non-current liability presentation will take place. Have you understood? Confused? Normally what? Non-adjusting event, because banker had right on 31st March or not? He forgone the right on which day? Subsequent. That is subsequent event, purely subsequent. But he had a right on 31st March. Right. But see, even though it is a non-adjusting event, we are recognizing as a carve out. Okay, as a carve out. We said Ind AS is saying, I know this is a non-adjusting, still I don't want to consider it as a non-adjusting. Correct. This is an exception to current non-current liability ka rule. Current non-current liability rule is given where? Under Ind AS 1. Where is given? What is current non-current definition? Ind AS 1 में दे दिया. So Ind AS 1 current non-liability का exception, one exception is this one. That's how Ind AS 10 linked with IAS 1 with this point. Understood? Next, there is one amendment in a few months before. Okay, amendment not applicable to you first. So whatever I taught, whatever is there in my book, it remains same. In the near future, 27, not for 26 full. Okay, na? So may attempt anta, I don't think that way also. Not in 2026 attempts, no. 27 may it's going to be current liability only. It is in line, a carve out will be out. Got it? So once the carve out is out, you will be in line with IAS. Hope you understand. It will become what? Current liability. Means even subsequently after 31st March, you went and convinced the banker. Got my point? No issues. Done? Right, that is the only matter. Let's go to 1 second. I'll note it somewhere question numbers and page numbers. Yeah. See, if you see this concept capsule 9, that was asked somewhere in the past, January 2021. Okay, right. Just let's read this, you will get an idea. That's all. Other than this, only one more point is there. What is that? Exception. Then the standard only is completed. It's like that. Very small standard. Just run through the question. Entity A has obtained a long-term bank loan in the month of January 2021. Okay, X ko you make it 2. Right? That is up to you, know that. X is dash. You can keep 2 or 3 or 1, whichever you want. Which is subject to certain financial covenants. One of such covenant is that, okay, during the tenure, the ratio of this debt is 65:35. Means debt should be 65, equity should be 35. So debt cannot go up. It can come down. It can. Okay, but not beyond that. Right. That should be maintained all the time. In case of breach of this, loan will become demand. payable immediately. Okay, the loan agreement states that covenants will be assessed at the end of each quarter, reported to the bank within the month from the balance sheet date, whatever. If the covenants are breached at this time, the loan will be repayable immediately. Okay, right. So the entity closes its annual accounts on 31st March, right. You are required to show how the loan will be classified on 31st March 2022. Done. So at the financial year end, entity determines there is no breach in the covenants. If there is no breach in the covenant, it will be what? It is a long term. You only told na long term loan. Long term loan means it is going to be non-current liability. Very simple. Second bit, what my dear? At the end of at quarter December 2021, that was December. Okay, entity yes, debt equity, debt has gone to 75. It should be 65, maximum 65, but it's gone to 75. Means they have taken additional loan, which is risky to the existing lenders. Correct. Then they will exercise their right. And thus breach the covenant. Yes. However, it obtains a waiver from the banker. Okay. The term of the waiver specifies that if the entity rectifies the breach within 12 months from the balance sheet date, then the bank cannot demand the loan immediately on account of breach during this period. From the balance sheet day, from the reporting date, it is telling 12 months. You have got a time. What is the time? 12 months may rectify it. Rectify in the sense repay the loan. Some loan ko repay karo, then automatically 75 will become 65. Then I am fine with it. Okay, na? Right. So you have got a time, how much, my dear? 1 year time. Correct, na? So as on 31st March, whether the banker has right to come and ask me? No, it doesn't have right to ask. Correct, na? Because they only gave a permission for next 12 months. I will not ask you. Agree, correct, na? Still, it is going to be non-current liability. Correct. Entity A expects to rectify the breach by raising additional equity. Yes, correct. Now, when you can repay the existing loan or you can issue the equity, whichever percentage, it has to be 65. That's all. Right. By means of a rights issue to the existing shareholder, expects that issue will be fully subscribed. That's okay. That is their expectation. But end of the your expectations are secondary to me. But whether the other party has got a right? No, not immediately. So this is also going to be non-current liability. Agree, na? Right. Next, considering the same facts of above, except obtaining the waiver clause, what would be your answer? If you have not got the waiver, what is your option, my dear? Obviously, current liability, it will be simple, right? So this is non-current liability, This is current liability. I'm just looking at sufficient. Na? You want to read the full answer? Not required. That is time waste now. Okay, right. Next, concept capsule 10. I will read it. That's all. We will be done. Yes, my dear. In that question. Actually, question में he said, however, it obtained the waiver करके they told. Which date they have not mentioned. हाँ हाँ. Non-current liability only will take it, even though it is a non-adjusting exactly. As per the carve out, will be considering it as adjusting. Assumption is we have got the waiver on 31st March only you got the waiver, or 31st December only you got the waiver karke will assume. That's what I told. Even though it has happened in April, we'll assume that it took place in the month of March. Grace period? No, but whatever the sentence he said in the question is what is it mentioning? Period from the reporting. Reporting date means balance sheet date. Yeah, when you got not from that date, from the balance sheet date, next 12 months I will not ask. Question is that you have to go by the language of the question. Correct, na? Yes. So we have got a good amount of time. 12 months. Current liability. Not current liability, non-current liability. Correct. He can come and ask me on 1st April next year. Assumption here in this question actually. balance sheet date, still as per our carve-outs, as per Ind AS, anyhow it is going to be adjusted. Okay, assessment has happened on December quarter. Information will come out only of the December quarter financial debtor calculation will be happening on next day. Next day only you should go to banker and ask, I did some mistake, so please waive it. Okay, right. Let's go to this question. In December 2021, an entity entered into a loan agreement with a banker. Okay, the loan is repayable in 3 equal annual installments starting from December 2025. So, first 4 years you don't need to pay anything. After 4 years, equal installments 3 times, means 26, 27, 20, whatever it is. 25, 26, 27 or 20, whichever. Right now not relevant to me. One of the loan covenant is that the amount equivalent to the loan amount should be contributed by the promoters by 31st March 2022. Okay, na? Means what? They gave December, May, you took the loan. Next year, I mean a period of 3 months you can say. Within 3 months, you have to get same amount of equal contribution should come from the promoter also should give that much money. I gave 100 crores, you have to bring 100 crores from promoter. That is the rule within 3 months time. Failing which, the loan become repayable on demand. If you don't, okay, deadline is before 31st March. Right, as on 31st March 24, the entity has not been able to get the promoter's contribution. Couldn't get. So banker has got the right on 31st March 24, sorry, 24th March only you got a right to ask. Okay, on 25th, the entity approached the bank next day and obtained a grace period up to June to get the promoter's contribution. Will not be able to satisfy. Correct now. Just extend the date. Correct now. 25th date shifted to June. Correct. Are you getting my point? When did you approach them? Before 31st March only. Correct. Before 31st March only. Now the date is extended to June 30th. Correct. Means original date of 24th March cancelled. That is replaced by June 30th. Agree? Right. Now, as on 31st March, whether a banker has a right to come and ask me? Correct. Till 30th you cannot approach me also. Correct. 30th June can you approach me first? Agreed? Right. And whether you will come back and ask me is again depends upon the contingency. Contingency means I may get the promoter's contribution. Paisa leke aa sakta. That time you will obviously ask only in 25. Am I right? Correct na? 30th June will you come guaranteely? Depends upon my activity. Correct? Right. Chalo. That first question understood, no? Done. The bank cannot demand the immediate repayment during the grace period. During the grace period, it cannot touch. It can come only on 1st July to your door. Done. The annual reporting period is 31st March. Done. As on 31st March, how should the entity classify the loan? First tell me. Current liability. Why? Grace period is within 12 months. So 1st July May, these guys can come back and ask. Not like 12 months from the balance sheet date in the above sum. Agreed? Correct, na? So it was already due. You breached the thing. That's why it is shifted to grace I have given. Actually, it is supposed to be 24th March. Now 24th March is replaced by 30th June. Within 3 months, it has already become due. The banker has got a right to collect the money from on 25th March only. Banker had got a right. Agree? Just shifted to 3 months extra. Agree? I mean, what do I say? Initiation started. Correct na? You just deferred for 3 months. You can stop the banker for 3 months. Agree? Yeah? Right. So that's why what he said, current liability is okay. Now look at the next question. Then you will get the clarity, much better clarity. Right. Assume the anticipation that it may not be able to get the promoter's contribution by the due date. Okay. In the month of February itself, in earlier question, it was due on 24th, we went on 25th March. Are you getting my point? It is already triggered. What is triggered? Breaching the covenant is already triggered in the first situation. In the second situation, is it triggered, not triggered? Not it triggered. Not, are you getting my point? You went in which month? Feb. Not after violating the rule. Hello, understood? Right. So in February only you went. The entity approached the bank and got the compliance date extended up to June. You got my point? Now original date of 24th March is shifted to 30th June. Is there a difference between these two? What difference? On 31st March breach had not happened. Correct, na? In earlier situation breach happened. Now you got a grace. In second situation, correct. Now we'll wait for the subsequent event contingency scale. I can wait for some time. I hope you understand. Now, okay, in this case, will the loan be classified different from A? Na? Yes. I will say now it will be non-current liability. I will classify it as non-current liability. Yes. Here, I hope you understood. So, what is the point to be noted? If the breach take place, how much grace period is available? It is less than 12 months, current. If it is 12 months above, then it is non-current. If breach only not happened, breaching date itself is extended. Breaching date itself is extended. Then as on 31st March, since breach only not happened, then what right you, whether banker do not have right to approach me only. Banker also has to wait till 30th June. If I do not satisfy the conditions, then they will get the right. Till that time, they will not get the right. Agree? Yeah? It is like a still loan agreement में condition लिखा. It's just a condition. It is depends on contingency. That will be purely non-adjusting, non-current liability. It continues. I hope this is clear. Can I go ahead? Ind AS 10, Ind AS 1, all these things always better you write it. It's actually strictly speaking Ind AS 1. Okay. Second point especially, I mean actually Ind AS 10 is not required for both because both are happened already. It's not a waiver subsequently. Fine. Ind AS 1 is sufficient. 10 is not referred. Because you understood, no? Both are is there anything happened after 31st March? It is not an event from the balance sheet date to board of directors approval. One is more than sufficient. Perfect. Can we go ahead? Right. Next, what are the exceptions for this rule, my dear? What are the exceptions of your adjusting, non-adjusting? Only one. What is that? If the subsequent event, correct now, if the subsequent event is affecting what? Going concern assumption. Going concern assumption. If it is impacting going concern assumption, then even though it is non-adjusting event, correct now, even though, right, what is that you are supposed to do? Even though non-adjusting event, assume as adjusting event. Yeah, we've seen one company in this 25 only. Okay, right. What has happened in the month of somewhere, I mean to say August, we signed the financials in the month of September. In August month, what has happened? They have taken a board of directors resolution. Board of resolution for what? Liquidation purpose. Yeah, they have another plan. What is the other plan? They want to open one. They have one company in Delhi, but now the plan is changed. The strategy is changed. They wanted to have one company in US, and we want to open one company in India as a subsidiary to the US company, as per their strategy. That is irrelevant to class. Okay, so that's why existing company. There are some issues why this existing company only should have become, they should have sold the shares to the parent company, they would have done it, but they don't want to do. Some reasons are there, ignore that. So existing company they want to close it and they want to open a new company which is going to be subsidiary of US entity. Done. So in the month of August only they passed a board resolution. Correct? September month mein we are signing the financial statements. Now, correctly speaking, this is adjusting or non-adjusting? Non-adjusting event. The decision has come, not there is no situation or condition holding on 31st March. Correct na? Right. So that's why in the month of March 31st, how are you supposed to prepare financial statements? You are supposed to prepare it not at the historical cost. You have to prepare it at NRV. Any gain or loss is transferred to profit and loss statement. Have you understood what I said? 31st March 2025. 31st March 2025. Financials are prepared on what basis? Liquidation basis, at NRV basis. When is the event happened? August may happen, before signing the financial statements in September. Agree na? Correctly speaking, is non-adjusting or adjusting? Non-adjusting. But is it an exception to the basic rule? Yes. If it is exemption, means what are we supposed to do? Even though it is non-adjusting, it should be considered as adjusting. That means what? This event has happened before March karke assumption le. Understood? So if it has happened in the month of March, then what do? How do you prepare financials? Under NRV. Now also you prepare it under NRV and present the financial statement. Yes, we have done it in the same manner. Hope that is done. Any question from Ind AS 10? Small standard, simple standard. Okay, I feel that much is sufficient, not to spend too much time. Right. Shall we go to Ind AS 8? Ind AS 8. Ind AS 8 is what, my dear? Accounting policies. Next, accounting estimations and errors. Yeah, and errors. Yeah. First, policies correctly, if you listen, no, the errors job is more than half is done, because retrospective application, retrospective restatement, all will be covered under accounting policy correctly. Right. Whatever impracticable to restate, that is also because whatever we discuss under this, that is going to be same under the prior period error. Okay. Estimation is a very small topic. Done. So as you know, policies means what? Policies are what, my dear? These are the methods. Correct na? Next, these are the methods, these are the principles. You can call it as basis, you can call it as conventions. Correct na? So many things will be there which are adopted. Kya bola? Which are adopted by the entity for what? For preparation and presentation of financial statements. You are preparing financial statements. Correct na? The first point you need to catch here, adoption. Adoption means what, my dear? Adoption means it's a choice. You have chosen. Correct. I have chosen. Whatever you have chosen, whatever we have chosen, that is your company's accounting policy. That's all. First point to be remembered. Suppose if I say, sir, I don't have a choice. Kya bola? I have no choice. Then it is not a policy, first of all, my dear friend. It's not a policy only. Are you catching the point? If there is no choice, then it is not a policy. Hope you understood. Right. Sir, example. Yes, example. Recently, I taught all IFRS classes I taught. So, word Ind AS is not coming out. IAS only coming. Right. That is the problem. Fine. Ind AS 16. Ind AS 16 is PPE. Correct na? PPE may you have got two models. What is the two models, my dear? One is cost model, next is revaluation model. Yeah, can you choose any one? Yes. Is it a choice or not? Yes, it is a choice. For each class of asset wise, you have a choice. For land, I have gone by revaluation model. For building, I have gone by cost model. Choice. So this is accounting policy choice. Okay. In Ind AS 109. Okay. In 109, timing of recognition. Okay. Have you heard these two timings, my dear? When you purchase any asset, FA, financial asset. When do you record? There are two dates. Transaction date or settlement date. Okay, there are two options are available. Correct now. What is this? Transaction date or settlement date. Settlement date in the sense T plus 2 days or T plus 3 days or something will be there. Okay. Today I bought for some of the shares in India T plus 1 day. For some of the shares in India, not every share same way. T plus 2 days will be applicable. Correct na? So which date I should account? Is that the day today I purchased some shares. Today na T plus 2 days. Should I account it after? The issue will come like March 31st you bought it. 1st April or 2nd April depending on Sunday, Saturday and etc. So say example April 3rd you got the settlement, means your money is cut from the demat and you got the share in the demat. Agreed? Sorry? Which date you should follow? This is again accounting choice policy. It is allowed, left to you. Okay. Trade date. Transaction date is trade date. The word is there, trade date. Okay, right. Doesn't matter. You have a choice like this: trade date accounting or settlement date accounting. Two are available to you. There you are picking one. That is called a choice. Hope you understand. Right. Next. When you are going by which choice, which policy are you supposed to follow? Do you know any hierarchy? I'm supposed to pick the policy. Correct. I have to pick the policy. Which kind of policy? First thing. For sometimes what happens now, how to account I don't know. Is a such transaction maybe right away available accounting in the IFRS or Ind AS will talk. Correct. First priority should be given to your Ind AS, similar assets or liability, whatever it is, similar accounting, similar item accounting you write. Okay, accounting means first priority. Suppose that there is a new transaction is taking place. How to account it? When accounting standard Ind AS is silent, then accounting policy choice will come into the picture. Are you getting my point? Government grants have come. We have a standard. Correct? How to account? Look at the standard and account it. Suppose I have seen one transaction. I have not seen. Okay, right? Because whatever seen transaction, all are fitting under standards only. So far. Very rare circumstance mein ho sakta. Okay. No standard is available. Now what to do? Should I capitalize some expenditure? Should I charge to P&L? You don't have a clarity because there is no standard, doesn't exist. Now what should I do? When there is no standard, then accounting policy choice starts. I hope you understood. Example, I'll tell. One case I can tell where I said I have not seen, but I have seen. Okay, I'll tell this. Listen carefully. Financial guarantee contract. Have you heard this word, some guys? Sometime before we do, you must have read this. Correct now. Financial guarantee contracts under Ind AS 109. It is discussed. But whatever 109 discussed, from whose angle you know? From guarantee issuer. Correct now. Guarantee, who gave guarantee? Hello, understood? Whose point of view? From the point of view of issuer of guarantee. I gave guarantee. How should I account? I should account it as a liability at present value. Later amortized amount or the ECL, whichever is higher. That is fine. Clear. Correct na? But what about you have taken a guarantee? Then how should I account in your books? Standard silent. Okay. Receiver. Receiver books में standard is silent. No guidance is there. Now, does he need to account or not? You understood what I said? He's taking a loan from the banker. Okay, this man is taking a loan from the banker. I am giving a guarantee to the banker. In case this guy does not pay, You can catch me. Karke I am giving. How should I account? 109 clarity is there. What about him? Suppose because I gave a guarantee to him, he paid me 10,000 rupees commission kind. Hello, understood? E 10,000 should be considered as a transaction cost of that loan, or should it be charged to P&L? You understood? If it is transaction cost means EIR may impact karna kya? What is accounting in his books? Standard is silent. What to follow? Don't worry, exam mein aisa nahi aata. Okay, don't think too much about this. But you understood situation? Correct na? Generally what happens, okay, even if I teach in detail also, like I do teach differently, but the problem is one side accounting will teach. What about other party will record what? I am only going to consolidate, not too much. Practically, I only have to do that. Hello, understood? मैं क्या लिखना? That also you have to think, then only the holistic view and correct, complete view will come to you. Otherwise, what is that you learnt? There are two choices are there. Accounting policy choice. He can just ignore that and charge it to P&L, or he can take the transaction cost. But we say if it is directly linked, because you guarantee whatever is given directly related to the loan you have taken or not. Whatever the 10,000 or X amount you have paid, it's purely a transaction cost. So consider for EIR, karke will tell. Sir, holding and subsidiary has not paid, one paisa also has not paid. Then what will happen? Then also we need to measure the fair value. I'll tell you that little later. Okay, so it is under such circumstance, what is that? What the standard says, Ind AS 8 says about such thing. When you don't have a guidance, straight guidance is not available. On similar items, do you get any guidance from Ind AS? Hey, if you say, please look at it and follow that. No, I don't find similar guidance, I'm not able to get. Then it says, then you go by the definitions. You go by the definitions of what? Definition of asset, liability, equity, income and expenditure. Okay, this is expenditure and conditions of conditions as per framework. As per framework. Okay, as per the framework. Framing. I mean to say, I want to capitalize it. I want to say take it as a liability. First, when you say I want to capitalize means asset, or is it asset means asset conditions? Does it satisfy? You got my point. Go by the conditions of asset. If it is satisfying, then only recognize as asset. Otherwise, you should not recognize as an asset. I hope you understand. Right. Third is IASB pronouncement. Because okay, IAS Ind AS में pronouncements नहीं है sir. Our ICA has not given any pronouncement. What should I see? Look into IASB pronouncement. IFRS.org. So many pronouncements are there. Have a look at it. If they had given internationally some guidance, you can please look at, follow it. So that is also not available. That is also not available. Other gap. Other gap means which will be in line with IFRS. Okay, right. US gap. Not exactly in line with, but okay. I may look at, suppose IFRS may not there. I'm confused with asset liability conditions, may I'm confused. Direct pronouncements are not there. Then I can look into, peep into US gap little and see, can I get some guidance over there, which is not contradicting with my asset liability and our basic concepts should not contradict. Then you can follow the IFRS things, etc. Okay, right. So whatever you have picked, what I told indirectly here, policy is not always with respect to the accounting. Policy is with respect to measurement, with respect to recognition, with respect to accounting timing. Correct. Now, accounting timing, best example is Ind AS 109 itself is the accounting timing. Correct. Now, so I mean like cost or model is equal to what? Measurement. Subsequent measurement ka models. So different places mein different kind of policies are there. Policy means which is a choice chosen by the management for preparation and presentation of financial statements. Correct, na? Right. And so if you have a policy straight away, then if the accounting IFRS or Ind AS has given a clarity, then there is no discussion of policy. If IFRS or Ind AS is silent, then the problem starts. Correct. As I gave you, what is that I gave you? Financial guarantee contract. They spoke from the issuer of the guarantee. Who gave the guarantee? How should I book? That is given. But who has taken the guarantee? Iska baat nahi kar diya. So then what should I do? I have to peep into these things. Then what should I do? Whatever the policy I am picking, that should be in line with my right 1, 2, 3, 4 circumstances we gave it. Correct? Right. Can we change policy? Can we change accounting policy? Yeah, right? Doubt do. Yes, no. Can we change or not? Retrospective, prospective, we'll see later. Can we change or not? Yes. Obviously, we can change. Under what reasons you can change? For better presentation, no doubt. Next. Change is as per law. Law word will not come in the Ind AS. Because anyhow, law will override the standard. That's why we don't speak. Again, IFRS when they are framing, which country law they should consider? IFRS is there all over the world. Correct. Except some 2, 3 nations. USA is not there, China and Japan. Only except these three, entire world is following IFRS directly or indirectly. Got it? So which law I should consider? So many countries, so many laws are there. That's why they never speak about the law. Not law, as per Ind AS requirement or as per for better presentation to make the financial statements more reliable and relevant. Okay, right. First question is simple. Is the change as required by Ind AS? First question I'll ask. As required by Ind AS. So I mean Ind AS में amendment आया कुछ. Yeah, earlier IAS 17 leases 2019 तक IAS 17 was applicable. 116 came in 2019 effective. 116 has come. Earlier Ind AS 11 plus 18 for revenue. Okay, that has become Ind AS 115 later. So changes happened. Earlier lease accounting was different. Now lease accounting is different. Earlier recognition of revenue was different. As per 115 it is different. Okay, you guys are studying now, so you don't know what has happened in the past because we are seeing it from long. So we know that. Right. Answer can be what, my dear? Yes, it is as per this or no. If you say yes, correct, it is because of Ind AS requirement I am changing it. Under that circumstance, what should I follow? Under this circumstance, what should I follow? Very simple, Amma. Standard only will give. Standard transitional provisions. Transitional. Yeah. 99.9% no, they don't ask every time retrospectively follow करके they नहीं बोलता. Right. The best example is Ind AS 115 also, Ind AS 116 also. They have never forced. They go back to all these years and come back. No, they didn't say that. Hope you understand. Whatever transitional provisions say, that only you follow it. If they say prospective, prospective. If they say retrospective, retrospective. You don't have a choice. They only told how to follow. What is your problem? Correct, na? You follow. No. No means what? No means for? No means what? For reliable. Correct, na? Better. Better, reliable and relevant financial. Relevant financial statements purpose I am doing it. Now question. I am doing this is nothing but voluntary. Can I say simple? Isn't it voluntary, my dear? Yes, obviously it is voluntarily I am doing. Standard is not asking me to do it. Then you don't have a choice, my dear. It is a retrospective restatement. Yes. You don't have a choice. You have to go by retrospective restatement. Okay, retrospective restatement or retrospective application may be the better word. Retrospective application, not instead of restatement. What is retrospective application? As if this policy followed from my date of incorporation. You understood my point? क्या बोला? हाँ, apply from the date of incorporation. Apply from date of incorporation. Yeah, from that date say if I had, correct na? And again, retrospective application mein, what are you supposed to do? You will give the impact to only that item. No, you have to consider what? You have to consider tax impact. Tax impact means deferred tax. Yeah, deferred tax को impact देना पड़ेगा. Correct na? Because of it, your asset or liability will be, you're changing the policy. Automatically, it will undergo for a change. When it undergo for a change, our number also will impact. Because of it, my deferred tax number also will impact. Hope you understand. Right. Everything as if I was already following from the beginning. You have to go back to respective year and do correct. Next. So because of this, what will happen? Third balance sheet. That is opening balance sheet of previous year must be presented. Correct na? Mandatorily you are supposed to give the third balance sheet. Right? So if I say this is 31st March 25, this is 31st March 24, this is 1/4/2023. This is the third balance sheet. Correct? Listen, the impact of from here to here. Sir, what is your date of incorporation? Sir, 1/4/2020 is my incorporation. Incorporation date is 1/4/2020. Okay na? So 2020 से 31st March 24 तक E impact will be given where? On 1/4/23 में you should give the impact. And impact related to this period 23-24 will be given in 31st March 24. Anyhow, current year impact is current year impact. Have you understood what I said? Correct na? Because of this, my asset should go up and down, or whatever it is, asset or liability or any income or expenditure. Entire impact is going to be happening on 1/4/23. 1/4/23. Will we go ahead? Right. Now here there is a possibility of impracticable retrospective application. Retrospective. Right. Tell me, if it is impracticable, what should I do? If it is impracticable, what should I do? Any idea? Prospectively do it. Okay. From where it is practicable, from there you follow at least. Maybe my date of incorporation 2020 तो at least okay. If it is 1920 से हो गया, my company या Tata company यार born long ago, not recently. Correct na? Who will go to 1920 and come to 2025? Agree na? It's illogical and maybe not possible to go back and come back. Correct na? That time what she is telling, go back, I mean to the extent possible. Suppose if you say last 10 years I can do it, it is possible for me. Then she is telling do it from last 10 years. Do you agree with her? Question is, yeah, she's partly correct, not obviously wrong also. Right. The point is impracticable means there is two ways done. The first thing. What is the problem? Cumulative impact you don't know, or periodic impact you don't know. First thing, question you should ask. What is the question you should ask? Example, periodic. Periodic impact. Not known. First question. Next is what? Cumulative impact. This is not known. Hope you understand. Right. What is periodic impact? I am giving how many years? Only 2 years. Generally, nobody will give more than 2 years. Correct? Na? I don't know what is the impact. I mean to say, example, simple example to make you subject clear. Revaluation. Earlier I was following cost model. What is the old method? Cost model. Now new method, what I want to follow? Fair market value I want to follow. Example. Agree? Yeah? Right. If I go and measure fair market value as on this date. Fair market value as of 31st March 24. What numbers are? So example, my carrying amount is equal to 100. Fair value is equal to 4,000. Example I am telling. So there is an impact of 3,900. But if I know the fair market value of here is equal to 3,500, if I keep this number, then I can say, okay, it has gone up by 500 rupees from the 2023 to 24 May. It is gone up by how much number? 500. Correct na? But but somehow if I tell E number, I don't know. What did I say? 3,500 malum nahi. I am not able to measure. My valuer also is telling illogical to measure 3,500. Ab kya karna? You understood the question? Correct na? If I take directly to 100 to 3,000, 100 to 4,000, 4,000, I mean 3,900 gone up in 2023-24 is too much. Are you understanding practical issue? Correct na? So kya karna dekh? What should I do? I will be knowing this number, I know, no doubt. This number is 4,100. E number not a problem. E number also not a problem, but I don't have the earlier number. If I don't have earlier number, impact to 23-24 is a question mark. I can't determine. Now what should I do? Prospective will not work here. Correct na? A concept doesn't work. Any idea? Right, not a problem. What you will do? To the extent of 4,000, you don't do it on 31st March 24. Don't do it. Forget. Pass the journal entry on 1/4/24 by giving impact to reserves. Hello, understood? What did I say? Even though you measured the number, on this date for 4,000 rupees, but don't give an impact on 31st March 24. Because, why? Because if I want to write on 31st March 24, correct na? Entirely 3,900 impact will come in 23-24, which is illogical and not correct. That's why what are we supposed to do? Next day, 1/4/24 ko, what is the entry you record? Revaluation reserve asset goes up. Correct na? Asset increase karo, revaluation reserve increase karo by 3,900 rupees, means it will become to 4,000. Hello, understood? Now on 1/4/24, how much is it? 4,000. By 31st March, what is the number? 4,100. 100 rupees ka impact will be given in 24-25 financial year. Are samajh mein aaya? When you don't know periodic specific, what are you supposed to do? Record on 1/4/24. I'll say simple word. Beginning of the financial year. What do you say? Beginning. This question is there in one of the ICI material, I doubt, which is there in my textbook. Okay, because you don't know this. You have to impact. You cannot impact on 23-24 में impact नहीं कर सकता. If I do impact means it will be too much. It's wrong exactly. So do it on opening. Of the current year itself, opening में कर दो, then matter will be solved. That's how we do handle. We have to handle like this only in the practical scenario also. That is allowed. That is only allowed as per the standard. Right. What is this cumulative impact? I don't know. Cumulative impact means what? I cannot go to 1990. Correct na? I cannot go to 1990 and come back from 1992. Correct na? From 1990 to 2025. Not possible. Yes. To recalculation. This is recalculation example. I am not possible. Then forget about it. If it is possible from 2020 to 2025, this is prospective. Here prospective is accepted. Prospective means not prospective again. It is not prospective. Correctly word, prospective word should not be used. Are you getting my point? Cumulative impact कितना? From 1990 से 2020-25 तक calculate किया तो एक number आ जाएगा. If you are able to do it, do it. It's very difficult, sir. I don't have data also to go back and come back. It is possible for me from 2020 to 25. Then chalo yaar, from which date it is possible? From that date you start following. Retrospective only still. Retrospective application from, instead of 1990, you are following from 2020. Is that concept clear? Right. Same concept, my dear, is applicable for errors also. Okay, right. Chalo. Next one, next point is change in account. This is done. Any question from accounting policies? If I have any specific question, I can answer. Hope you got some idea, some overall revision, some small gap. If there is any, that is also filled. Okay, done. So change in accounting estimation, I am going by. Change in accounting estimation. Yes, my dear. This is straight and simple, amma. Correct na? Change in estimation. Right. One more thing. Sorry. Before changing, I'm sorry. Okay. Right. Here, one question was asked in accounting policy only. Right. See, you know PPE is there. PPE ka two models are available. Right. What is the model? That one is cost model. Next one is revaluation model. Correct. Assume my policy. We have picked this policy. Revaluation model I followed. Later, I have reclassified. What have I done? Reclassified. What you reclassified? PP is reclassified into investment property. That is Ind AS 40. Correct na? Ind AS 40. Why it is reclassified? So far I was using it for my business purpose. Now I have rented out. Correct na? I have rented out. So then automatically it will become investment property. Correct na? Done. So when it is investment property, here I am supposed to follow only cost model. There is no fair market value model available as per IFRS. IFRS में fair value model available, not revaluation model. Fair value model will call. Their fair value model में the problem now. Why we have not taken in India? Because what they say, cost to fair value transfer to P&L, not to revaluation reserve or something. Transfer it to P&L happens. Hope you understand. Right. That's why India said not acceptable. We don't want to take that hit to P&L. And again, revaluation model may, is it mandatory to test for fair value on every year? If you are going by revaluation model, is it mandatory to test fair value every year? Not necessary. Actually, not necessary. Very well written in the standard itself. 3 to 5 years is the period, good period. Today I did. After 3 or 4 years later, I can do it. But in case of fair value model, mandatorily every year you have to get it valued. Some problems are there with fair value model. That's why India took a carve out. We don't want to follow fair value model. We want to follow cost model only. Nothing wrong. That is a good choice. I also personally felt. Okay, fine. Chalo, chodo about other things. Now, earlier what I was following? When it was PPE. Now it is shifted to, right. Now I should follow cost model. Is it a change in policy now? This was asked for 4 marks in the previous exam. I mean, not last exam, in the past. Question clear? Is it change in accounting policy or not? No. It is not a change in policy. It is not my choice, man. It is there is no, is there any choice? No choice. If you had given an option for FMV, I would have taken FMV only. You only said no, not to follow. Correct. And again, it is not like my, I mean, for better presentation or something, nothing like that. The asset, actual usage of the asset has been changed. Correct. Earlier I was using for my business purpose. Now I am renting it out. Then how? Correct. Na? So that's why, my dear, you cannot, this doesn't amount to a policy change. First point number 1 to be noted here. Hope you understood. Because such kind of question he is asking. Right. Next, if you say no gratuity applicable to my company because my number of employees are below 10. Okay, na? You know, gratuity though applicable when you have 10 or above employees. If you, I think above 10, then gratuity as per the India applicable. Last year sir, previous year mein kya? Previous year mein 9 people were there. So we didn't provide, we don't want to provide also, we didn't provide. Gratuity not applicable, it's left to me. Correct? Right. Sir, but what about the current year? Current year, 40 people are there. Count as employee count gone to 40. Now, gratuity applicable or not? Correct? Right. Last year, what is done I did? I still did an ad hoc basis. Ad hoc basis means simply some number I kept it. How you got that number? God only knows. Okay. So, actuary also doesn't know. Done. Now, so 40 is there. Now, I am supposed to follow Ind AS 19. Yes. Correct. Na? Employee benefit standard, PUCM method. What is the PUCM? Projected unit cost method. Okay, right. The actual method, forget about it. PUCM method we are following. All clear. Now, does it amount to change in policy? Yes or no? Question clear? Last year situation kya? Ad hoc number I kept. Current year what am I doing? Actual valuation I am getting it done as per the IS or Ind AS 19. Correct? Now what should I do? Is it a change in accounting policy? Na? Yes or no? Na? Sure? Yes. I mean, you're right. Got it? There is, it doesn't amount to not a change in policy. Yes, not a change. Change means what? Something is there. You're replacing with something. That is change. Here, what is there to replace? There was nothing. There was no policy. Ad hoc is not a policy. Correct? Na? There was nothing. You just brought a new thing. This is not a change. Change means replacement. Correct? Na? There is no replacement. There was no policy at all. Ad hoc policy doesn't amount to two. Correct? Na? Ad hoc policy is not a policy, first of all. Fine. That is the point to be noted. Right. Change in accounting estimation. Now go to change in accounting estimation. That is only prospective method, my dear. Prospective method. Yes. Purely prospective. Right. Whatever happened in the past, forget about it. Right. What is estimation? Estimation is useful life is an estimation. Right. Useful life is estimation. Done. Fair market value is an estimation. Method of depreciation, correct? Na? Method of depreciation is estimation or not? Yes, method of depreciation or amortization is an estimation. Right? ECL, expected credit losses. Yes, is a big estimation. God only knows who will pay, who will not. Correct? Na? Correct. How do I know? Nobody knows it. It is an estimation. Right? So many things are there which are correct. Residual value of an asset. Yeah, residual value of an asset. Yes, estimation. So many such kind of things are there. Correct? Na? Impairment, estimation. Impairment is nothing but fair market value, I already told, indirectly. NRV is estimation. Unless until you sell, now you don't know what you are going to, at what rate you are going to sell, how do I know it exactly? Correct? Na? Right. So simple, you are supposed to go by prospective. Prospective means what do you say? From now onwards. Correct? Na? From now onwards. Whatever happened in the past, forget. Whatever is the WDV, catch that and only look forward. Don't see back. Correct? I'm just closing that with the small thing. Sufficient. Okay? Nothing much to do. What about error? Error. Something is crucial. Here, very logically, he has given the questions in the past. Whatever he asked, less number of times only, but asked, beautifully asked. We should appreciate that. Okay? Right. Error. When do you say error? Error has happened when it occurred in the occurred in the previous year or previous years, correct? Na? Either 1 year or last years, but identified in the correct, identified in the current year. Yeah, occurred in the past, identified in the current. That is what error basically. Yeah. So when I say it's occurred in the error, what is error? What kind of error? Error may be a mathematical, arithmetical error, mathematical, arithmetical. Correct, na? Done. Second one. Hmm? Omission. Omission, yes. Omission. Error is okay, fine. I will consider that also. Omission. Next, it may be fraud also. Don't say error is intentional, nothing. Fraud also error here. For the purpose of our standard, fraud is also considered an error. Okay. Right. Wrong application of accounting policy. Wrong application of accounting policy. You have chosen something but accounted something. Correct, na? Wrong understanding of facts. Wrong understanding of facts. Alright, happened something, understood something. That's why I accounted differently. Subsequently, you realized, I thought like this, that's why I accounted like this. Now you understood something. No, if I had known this, I would have not accounted for. Correct, na? Here, the point and the important point, what do I say? One word I would like to put it, okay, reasonably to be expected to have been obtained. That is the one word here. What is that? Reasonably expected to. Expected to. Expected to have obtained. Expected to have, okay, obtained the information. Yeah, this point based only this line based, they framed one question. Asked for 4 marks in the past. Okay, which is there in the textbook. What they say, actually information was available. If my accountant has seen properly, if he had spent enough of time, okay, reasonably, if I had worked on it, he would have not done this. You understood my point? If I had spent enough of time and data is available, he just need to pull the data, apply little bit of knowledge. That is not like AI knowledge is not required. Correct? The basic accounting knowledge only if he had applied, he would have done that job. But he did not do in the past. Got it? He did not do in the past. That's why this has come now in the current year. That is also error. I hope you understand. If you could have done this in the past. Correct? Na? That information was available in the past. Right? Now, no prospective. This is going to be retrospective. What did I say? Retrospective. This is retrospective restatement of financial statement. It leads to retrospective restatement of financial statements. What is the problem? Retrospective restatement to retrospective application, क्या difference? Both are same. Huh? Here also third balance sheet. Third balance sheet must. Except P&L impact only is there, balance sheet impact is not there, means the same concept will continue always. That's why I told in the beginning. Okay. A P&L impact to balance sheet impact, one time one question was asked in the exam. Is it mandatory to give third balance sheet? Not necessary. If it is only within the P&L, just classification of item, finance cost to other operating expense, other operating expense to finance cost as something is there, then no need to give third balance sheet. Two balance sheets are sufficient. Okay, so should be clear. That's why I told that point. Third balance sheet is must. What is balance sheet? Retrospective application, retrospective restatement. Application is something from the date of incorporation, when I say from that date to till date. Okay, right. But error is not something like that. Error might have happened only in the last year. So then we will go and correct it only last year. Hope you understood. Error might have happened 4 years before. Then we will go and come back. If it was no error, what would have been? Impact will come. But not all the time we will go to the incorporation date. Hope you understood. That's all. It is just a restatement of that. How do you do restatement here? as if error did not occur, as if error did not occur. Means last year में error था, you identified in the current year. Go to previous year financial statements, change, correct. If I had known this information before, what you would have done? Corrected na? You must have, recording means something debit, something credit. Do it in the last year and come back. But only do you do that one, my dear? Are you supposed to consider tax impact also or not? Yes, tax impact, deferred tax impact. Obviously, current tax co. Recently, I have seen one NBFC company financial statements. I only have done the, what is that, transition. Ind AS ka transition. Heavy work will be there, not a small level job. Not a software company co transition, NBFC co transition is big headache. Okay, money also will be like that only. Obviously, no, effort oriented it should be. And you know, I mean, the other party has done it to some extent. What he has done, previous year financial statements mein, what is changing na? Current tax number also is changing. Current tax, why will it change? Because of the changes in the other, because of the change in the Ind AS impact, no, that will come to deferred tax, but not come to current tax. Current tax is current tax. What was liable to pay that time, that is liable. Impact, some because of that error or something you are supposed to pay, that will become current in current year. You have to show that you have to offer that income or income only, expenditure you can't offer anyhow. Income you have to offer in the current year, and you will be liable to pay current tax in the 24-25, not in the last year you cannot do. Correct na? So they passed entry something like whatever the entry or linking is something. Apparently, previous year, earlier IGAP current tax number of the previous years I am talking about. Correct na? That number is changing. When we went, then we understood, no, wrong entry, wrong linking has happened. That should have become somewhere asset. This fellow has charged off under current tax only. Okay, this happens. Correct. Now we'll, point is simple. Current tax impact will not be there in the previous year. Current year mein current tax impact number will be there. Have you understood my point? 23-24 mein error happened. Okay, you went to 23-24 and corrected and came back. Due to which 23-24 mein deferred tax will have impact. Correct. And because of that, our deferred tax will be turned into current tax. Deferred tax will be reversed in the current year, and to that extent it will go up in the current tax, because you must have offered it in the current year. Have you understood? That impact is to be complete, not just only an item. Whenever any item you are touching, impact, you always should keep it in mind, deferred tax. Ind AS 12 has to come into your mind. Has it done? So that is what the difference, my dear. So restatement, retrospective restatement is supposed to take place. What should take place? Retrospective restatement should take place. Okay, right. I am good with this. I don't need to, whatever the concept capsules I thought of referring, that I gave you in a small explanation, I gave it off. Okay, instead of going and reading the entire concept. Okay. Chalo, let's start with the next standard. Next standard is Ind AS 20. Again, this is also not a big standard, that is government grants. Correct. Yeah, not a too big standard, but yes, 4-5 times the questions have come from this standard. Okay. And questions were for 8 marks also, questions for 6 marks also, not for 4 marks alone. Okay. Yeah, so that is a small standard, not very different and difficult standard, but yes, not to ignore. That's what I mean to say. Okay, right. Government grants, now there is only one approach, right? As you know, there is no approach called capital approach, which is there in accounting standard. Correct now? So capital approach doesn't exist. Now it is only either revenue or income. People call different words. It's okay. Okay, right. Revenue or income approach. That means what? What does it says? Every government grant, I write GG, that is my short form for government grant. Every GG is income approach only, revenue approach only. It should be routed through what? It will be through profit and loss. It will be only through profit and loss statement, not through capital reserve. There is no concept of capital reserve or capital approach. Everything has to be transferred to P&L. Right. So for that, what do we do? Basically, initially, what do we do generally? Initially, we'll transfer it to deferred income. Where do you transfer? Deferred income. Deferred income account you can call, deferred government grant account also you can call, both are one and the same. Okay, just doesn't matter. Deferred income. Then what do you do next? Next transfer to where? Transfer to P&L. On what basis? How do you transfer? In which ratio? You understood question? When you got the money, cash account debit to deferred income or deferred government grant. Or deferred government grant is what, my dear? Deferred government grant is a liability. Agree? Yeah? It's a liability. Yes, purely liability, not an equity. Not equity. It is not equity, it is a liability. Okay. From there, it will go to where? P&L account, P&L statement of profit and loss co will transfer it. In what basis? It is in the ratio of expenses. Okay, right. That is only called systematic, that is only called matching. Okay, right. In the ratio of expenditure, that you can call it as systematic or matching concept, whichever. Okay, that is only rational concept or systematic concept, they'll say. It should be routed through profit. It should be going to P&L in the ratio of expenses. Okay. Now one question can come, sir. Right, no expenditures, sir. I got government grant. I don't need to spend anything. No expense. Getting my point? Then what are you supposed to do? Immediately to P&L. That's all. It should go to immediately to profit and loss statement. Understood? What did I say? It should be in the ratio of expense. But agreement only says I don't need to spend. Correct? Na? As per the terms with the agreement, government, there is no expenditure to be incurred. When no expenditure is to be incurred, yes, transfer to P&L immediately. Got it? Right. Sir, that is first point number 1. Point number 2. Previous year incurred expense. Previous year incurred expenditure. Okay, but government grant received in the current year. Previous year kya kiya re? Previous year I was not expecting I'll get only. Previous year I thought I'll not get. Okay, I thought Ind AS 37 I'll go, correct? No? It's okay. We'll go back. Fine. So government grant received in the current year. What should I do? Expense already booked in the last year. Current year paisa aaya. Again, here also, immediately 100% amount will be transferred to profit and loss statement. Transfer it. Previous year we booked the losses or expenses. We thought nothing will come. There was no reasonable assurance that the government grant will come or something like that. Okay, I was not very sure of receipt. That's why I not booked the receivable. Current year government changed policy. Suddenly they said we'll give you. We'll take. We'll transfer it to P&L immediately. Because expense, future mein expense karna kya? Already booked. What is there to book? Nothing is there for future expense. So current year only book it. Okay. One more special circumstance. What is one more special circumstance? Government grant received only by us. Only by our entity. Right? No one in the industry. No one in the industry. That is to what? For purpose to support immediate financial support. Otherwise, immediate financial. Okay, immediate financial issue, I'll say. My company is facing some problem, deep trouble. Maybe the next stage is liquidation. Government is not allowing. The reason, if this company, big company is gone, means so many employees and everybody will be on the road. Not correct. So let's help them. So suddenly they send some money. You don't need to pay me back or something like that. Correct. It's not like a loan also. Then transfer it to P&L immediately. Don't. It is also exceptional. No. In the ratio of expenses, our concept doesn't work here. Immediate financial support of for the purpose we got it. Not everybody got it. Every company in the industry will be not in the liquidation stage also, na? Right? We got it because we are facing lot of issue. We suddenly got some money from the government, transfer it to P&L. Okay. Otherwise, normally it should be in the ratio of expenses. Future expense, what is that expected? That ratio may will transfer it to P&L. Initially, when it comes, deferred income co will transfer it. Later we'll shift it to P&L. Okay. Only one approach, income approach, no capital approach. Done. Next point. As you know, there are two conditions to satisfy to recognize the correctness. There are two conditions. There are two conditions to recognize government grant. Yeah. Condition number one. What is condition number one, my dear? There is reasonable assurance. What do you say? Reasonable assurance that conditions will be satisfied. Yeah, management should say this. Conditions will be satisfied. Okay. Yeah. So reasonable assurance. I can say, being a management, I can say that I will be able to satisfy the conditions. When you are able to satisfy condition, then money will be yours. Otherwise, grant will not be yours. Next, no uncertainty. No uncertainty. No uncertainty. Uncertainty in receipt. So no doubt whether government will give after satisfying conditions also. I don't have a doubt. Then please record it. Got it? Right. Sorry, conditions. Okay, question. Conditions not satisfied. Conditions not satisfied. But amount received. Why? What will happen? Sometime what happens, they will give the money to you first. And they will say you satisfy the conditions in next 3 years or 4 years. You're getting my point? Sometimes what will happen, first they will say, first you satisfy the condition, then I will pay the money. It is depends upon circumstance. One government, state government or central government, everybody will have their own policies in giving the grants also. Accordingly it will go. Hope you understood. Sometimes first they will give the money, then you should satisfy the condition. Sometime what will happen, first to satisfy the condition you spend out of your pocket, then money will come later. Okay, right. Now in this case what happened, I am not sure whether I will satisfy conditions or not. That's a doubt. But money to aa gaya. Now how to record it? Cash account debit. Credit what? How to record? Huh? Record as liability. Record as liability. Correct, na? It's not your money. When you say it's not, see, I will satisfy means deferred income. I will say deferred income means what? Are they also liability? Ne? Deferred income is my money. I am keeping it in the balance sheet to transfer it to profit and loss over some time. But when I say it's a financial liability, it's not my money. I may need to pay back. It is repayable. Are you getting my point? Repayable to government. Deferred income also liability. This is also income. All liabilities are not same again. Okay, right. So it is recognized as a payable to government as liability. Got it? Done. Now government grant can be received. Government grant can be received in how many styles? In two styles basically. One can come in kind, the another can come in cash. Okay, one can come in kind, another thing can come in cash में आ सकता. Okay, kind में आया. Kind में we'll call it as non-monetary government grant. The word we'll use, non-monetary government grant. Kind में means you got land, you got intangible, you got some other property, plant and equipment, correct na? You got etc. So many things you got it. All nice. Okay, right. Next, right. How do you record it, my dear? If you got something, right? Suppose it may be at free of cost. Yeah, you got it free of cost. Then how to record? Nominal value, fair market value, fair value, nominal value, no, anyone. Nominal value only, right? Not correct. Okay, it should be at nominal value or fair value. This is accounting policy choice. Yes, it is a choice. As per your policy, you can pick. Okay, fair value is fine, nominal value is fine. Both, anyone is fine, up to you. But okay, sir, fair value में account किया तो क्या होता? Sir, land I got it, sir. Yes. What is that you paid? I paid 0, sir. But what is the fair market value? Fair market value is equal to 4 CR, sir. Market value is to 4 CR. Right. I want to follow fair value. Yes, this is my policy. My company has chosen policy of FMV. Now what is the entry? Land account debit. Correct now, 4 CR. To what? OCI, yeah. OCI you shouldn't use, ma. OCI will not come just like that. OCI is exhaustive list. Remember always. OCI is exhaustive. Exhaustive means you can't bring anything new. 10 means 10 items. Aste. Clear? Remember this point. OCI is exhaustive. 10 items means 10 items. You can't bring suddenly 11th. Management, no management involvement. Okay, na? Be clear. These are all, I mean, if you know this fundamental rule, na, then mind will never go to OCI. That's why I'm emphasizing again. Got it? Right. Remember, OCI will never come. Deferred? That's all. It is deferred government grant. Deferred income, deferred government grant ko 4 crore. How long you will transfer? Land edu. Land life is infinite. Correct. I mean, approach is right. Agree with you. Conditions are important here. Conditions means first thing, land they gave not for agriculture, no. They gave to company for what? You should do some factory construct karo. Correct, na? And do the production, something like that. Agree, na? So at least the life of the building. They will ask you what? I am giving you land, construct a building, correct, na? And do the production, etc. business. So at least I know land life is infinite. That's why at least what are you supposed to do? At least over the life of building what you have constructed. Yes, in the ratio of depreciation of that building, ratio of depreciation. So I follow SLM. This also, suppose building life is equal to, sir, the building life is equal to 40 years. Correct, na? 4 crore divided by 40 years. Transfer it to P&L. Is it clear? Right, land is infinite. Correct, na? Life will not be there. I mean, life, infinite life will be there. Divided by infinite, anything is equal to 0 will come. But we should still transfer it to profit and loss statement. Next, it will never go to revaluation reserve, it will not go to capital reserve, it will not go to any other item. It will sit under deferred income only. Is that clear? Can we go ahead? Right. So let's go to cash method. Cash. What you have got? Cash you got. Cash you got means why they gave cash? First question should come. Why they give cash? If they give, not just putting in the pocket. Correct, na? Condition carry. Somebody, suppose if suddenly I come and give you 10 lakh rupees, I know you'll put in the pocket. Next question you should ask. Yen condition. Correct, na? What is the, when should I, is it loan or sir? First you should ask me, no. When should I pay? If it is loan means what rate of interest? All necessary basic questions has to come. not like taking the money only, right? It is directly related to, directly related to what? Point number 1, specific depreciable asset. Word is depreciable asset, specific comma. Question should tell very clearly, this is related because you are buying the machine, I am giving you this. Because you are buying this, I am giving depreciable asset, specific, not overall. Okay, or sometimes they can say factory, they can tell, agreed. But if they don't tell factory also nothing, then you should go to next one. Okay, second one is what? Specific, non-depreciable asset. Next, third is related to expense. Because you spend something, I am giving you this much. Okay, you gave COVID vaccines to your employees, I am giving you some money for that. You gave a training to your employees, you went to some rural area, you got trained some people, 40 people, 100 people go train there, that's why I am giving you money. You spent money, that's why I am giving you some money. Understood? Right. So here there is again accounting policy choice is there when it is specific to a depreciable asset. Correct na? Right. So point number 1, specific depreciable asset. What is that? There is an accounting policy choice. What have you received first? Cash you got. Correct na? So cash account debit. Credit what? Credit. Choice number 1, accounting policy choice hai na? Credit number 1, what you can do? Asset account. Choice number 2, deferred income account you can do. Either asset account or deferred income account will be credited. Any one of these two. It is reduced from the cost of the asset or it will be transferred to deferred income. Correct na? Sir, I am going by deferred income method. I am going by deferred income. Deferred income will go to P&L ultimately or not? In which ratio? Yes, this you transfer to P&L. In which ratio? Always in the ratio of expense. Which expense will be there? Depreciation, because it is asset na. So automatically question mind should think tell not generally, no, asset hai, asset ka expenditure depreciation will be in the ratio of expense. It should be transferred to P&L in the ratio of expense. If it is reduced from the asset, normal, remaining asset will be transferred, remaining asset will be depreciated over the remaining life, remaining WDV. Correct. If you are gone by this, what are you supposed to do, my dear? Remaining WDV over remaining life, right? Remaining WDV over the remaining life will transfer, right? Second thing, non-depreciable, okay, non-depreciable asset related. You got money, what you have received? Cash. Correct. It should be very clear, have you got the asset or have you got the cash? If it is asset, concept will be different. Correct. Nominal value, fair value concept will come. E said what will come? Right. You received the cash related to non-depreciable asset. I bought the land first. Then government gave me some money to me. Hello, understood? I bought land from my own pocket first. Next, government gave me the money. Are you understood? Right. So if it is non-depreciable asset, hai to kya karna? If it is non-depreciable asset, first question, relevant expense will be nothing. Why? Depreciation is not there. Agree na? But there can be some questions like land I gave, you only have to develop this land. You understood? You have to construct a wall, you have to make it flat or something like that. They gave a hill kind of thing, something to me. Okay, na? Right? I need to make it flat or something I need to spend. Right? If there are first question, are there expenses? Are there expense to be incurred? Are there expense to be incurred? Right? Right. As per the conditions. as per the conditions. Yes. If you say yes, what you will say? Transfer it to deferred income. Correct na? Next, in the ratio of expense, it will be transferred to P and L. Correct na? You said expenses are there. Expense ratio may transfer it to P and L. So first, when you get the money, cash to deferred income to profit and loss in the ratio of expenses. Which expense? You only told expenses are there. Expense ratio. Right. So no sir. No means immediately to P and L. Immediately to P and L. Sir, shall I reduce it from the land value? No, there is no such option. To land I will do. No, not there. Is it clear? Right. Any questions so far? Shall we go ahead? Right. So related to expenses, third bit. Here also accounting policy choice. Here also accounting policy choice. Again, two ways. First one is what? Reduce from expense. Simple amma. You got cash. Cash account debit. Correct na? Two what sir? Two what? Situation number one, expense. Situation number two, other income. Other income को transfer करो. Either reduce from the relevant expense or you transfer it to other income. That is if related to expense. I gave a training to employees. That's why you gave money to me. Training cost may cut कर सकता, or training cost will continue like this, other income will come as a new item. Okay, that's all. So with respect to refund, okay, if it is refund of government grant, tell me what will happen with respect to refund. All the things are normal. Only one general different thing is there here, which I can tell you. Right, sir, earlier first it is just a simple thing, na reversal accounting. What is this? Simple reversal accounting. Okay na? Whatever you did earlier, you should reverse it off. Done. Situation number one. Okay. Situation number one. क्या है सर situation? Earlier I transferred to deferred income account. Correct na? Right. Earlier to deferred income I have transferred. So that means first question is what? Balance sheet. Do you have deferred income? Yes. How much is there? 400. First, how much you got it, sir? I got 1000, sir. You got 1000 government grant. Balance sheet में आज कितना है? 400 is there. That means 600 must have already gone to P&L or not. Reversal means what should I do? First, are you supposed to give the cash of 1000 rupees back? Assume 1000 you are giving back. First, whatever the deferred income is there sitting in the balance sheet, that you reverse it off. Now deferred income has become 0. 600 कहाँ गया? P&L. That was created earlier. Now you debit P&L. 600, that is the balancing figure. Simple and straight. Correct. Now how much is balance sheet mein deferred income is there? That much number debit it. Balancing number debit the profit and loss statement. Okay. Right. Sir, second method. Because all the methods are deferred income only. One more method is there. Which one? Reducing from the asset. Correct. Now earlier reduced from depreciable asset. Earlier old entry, what is the old entry, my dear? Cash account debit to property, plant and equipment you must have done. Agree? Cash to PPE kiya aap already. Agreed? Now what should I do? Now what should I do? Now you will be doing PPE account debit to cash. This is first entry. Okay. But the problem is here now additionally you have to do one more. What is that? Excess depreciation. If you have to bring the carrying amount or book value of the PPE to that level if you never have got the government grant. Excess depreciation also you have to charge in the current year. Charge excess depreciation in the current year. I hope you know this. You are aware of this, correct? Na? What is excess depreciation here? Say example, 1000 rupees cost. Okay, government grant 400 rupees I got. So I reduced as per my policy 600 rupees. Say 10 years life, residual value is equal to 0. SLM method I am following. Correct ना? Say example 3 years का depreciation हो गया. 3 years का depreciation कितना? 60 into 3, that is equal to 180. 180 means 420 balance is there. Now refund took place. Refund how much you gave? You got 400. Correct ना? It will become how much? 820 आया. ये 820 का journal entry is this. PP account debit to cash. That's why you added this one. Now what should I do? If I had never got this, how much amount of depreciation I would have done? 100 per annum. Hello, correct na? But how much I depreciated? 60 per annum. Hello, correct? Yeah. Right. 40 reduced one you did? Yes or no? 40 into 3 is how much? 120. So minus excess depreciation 120. 120 किया तो कितना आ जाएगा? 700. See, if I have never got the government grant, 1000 minus 300 depreciation is equal to 700. So I should bring the carrying amount to that amount. If I never have got the government grant, 700 would have been there. Now also 700 only is there. The excess depreciation should be charged in addition to reversal entry. This is what something. This is not a new amendment. It's past. I mean, but it is there. Is this clear? Right? Chalo. Let's go to the standard. Yeah. Here government grant ka get a note actually. The numbers are not matched. Yeah, just see this. Final May 2022 is this is an easy one only, nothing difficult. Okay, yeah, let's have a look at it. Why not? Concept capsule 14. Shagun Limited received two different grants from the state government. Okay, cash grant, very clearly told. What you got is cash grant, monetary grant. 24 lakh rupees received on 31st March 22 towards the skill development of employees over a period of 18 months. Starting from 1st April 22. So first money came, then you have to spend the money later. Actual cost of the skill development program in the financial year is correct, na? Was 30 lakh rupees. Okay, and in the financial year 23-24, I mean first year made 30 lakh, next year made 20 lakh, something like that. How should this grant be accounted for in the books of account? In the ratio of 33:2 is correct. At the same time, you should say no, number of months ka chodo, whether it should be reduced from the expense, whether it should be showed as another income. That is also accounting policy choice. You should tell both the policies are there. If it is this way, it will be reduced from the expense. If the other way, it will be expense will be normal and other income will sit because it is related to expenses. Correct na? That you should catch out of after. Correct na? Where is the grant fitting? Next, grant of 10 lakh. That point is clear, no? Grant of 10 lakh receivable over 3 years. Okay. You will get the money not in one shot. First year 5 lakh, 2 lakh, 3 lakh ऐसा आ जाएगा. Okay, first year में 5 lakh, next year 2 lakh, next year 3 lakh. Contingent on developing the 5 gardens, okay, and maintaining them for the 3 years. Yeah, development is there and 3 years you have to do it. I mean maintenance also you should do. Gardens are developed in the financially 2001-2. So it's already ready. No. It's going to be ready. Yes. At a total cost of 6 lakh. The maintenance cost for the financial year is going to be 12 lakh, 15 lakh and 17 lakh rupees. This is your maintenance cost. Okay, right. So calculate the grant income or deferred income to be accounted for in this. Now what do I do? Question clear? Huh? You want to read once? Read, not a problem. So what would be the answer here after thinking? Like, let me repeat the question once again. The cash grant of 24 lakhs, let me remove this once for understanding. Yeah, the cash grant of 24 lakh rupees was received on 31st March towards the skill development of the employees over a period of 18 months, correct. Starting from 1st April, actual cost of skill development has happened 30 lakhs and 20 lakh rupees. How this grant will be recognized? So since you have received it at the beginning, correct, this number is going to be recognized as a deferred government grant or deferred income. Correct. So what do you record, right? Basically, you will be recording cash account debit to deferred government grant 24 lakh rupees, 24 lakh rupees you will be recording. Done, right? So afterwards, this will be in the ratio of 30 lakh and 20 lakh, that is equal to 3:2, right? Or what is that? It should be recognized as a liability. When I say liability, that is nothing but deferred income or deferred government grant. Yes, it is presented in the balance sheet, split current, non-current is fine. Right. So, that is current, non-current is 12 months, 18 months, that classification is right. Now, subsequently, what are we supposed to do? In the ratio of the expenses, it is supposed to be bifurcated, should be recognized in the profit and loss over the period. Right. What is the ratio, my dear, here? 30 lakh rupees is first year, second year 20 lakh, that is equal to 3:2 ratio. Right. So 24 lakh into 3 divided by 5, correct. At the same time 24 lakh divided into 2 divided by 5, E ratio may we will be transferring it to profit and loss statement. Then second point, the grant of 10 lakh rupees receivable over 3 years, correct. So I will get 5 lakh rupees first year, second year 2 lakh, next year 3 lakh rupees I will get. Contingent on the developing the 5 gardens, maintaining them for 3 years, correct. So totally my grant receivable is equal to 10 lakh rupees. It may come to me in 5 plus 2 plus 3. Agree? Agree? Right. But what is that? I said every grant should be recognized to profit and loss in the ratio of expenses. Correct. Now, what is your expenditure? The garden should be developed used at a cost of 6 lakh and should be maintained at 12 lakh. So that means my first year expenditure is equal to 18 lakh. How did I get 18 lakh? 12 plus 6 lakh is equal to 18 lakh. Next year it is going to be 15 lakh. That next year it is going to be 17 lakh. Okay. So in the ratio of 18:15:17 ratio, we are supposed to recognize, correct? Na? Yes, we will be recognizing total 10 lakh rupees will be bifurcated in this ratio. Yes, you observe. Yeah, 18:15:6, that is 50. Correct. So grant income, what do you do? 3.6. Yes. Right. So first year, what is the journal entry they should have recorded? When they have received the money 5 lakh rupees, that they would have recorded as cash account debit to deferred income, that is equal to 5. But out of 5, correct? Na? What is the grant income that is transferred to profit and loss statement? Right. That is deferred income account debit to profit and loss statement. It is only 3.6 we have taken to P&L. Next year, have you received 2 lakh rupees? Yes, again you have received, that is cash account debit to deferred income, right? 2 lakh rupees, 2 lakh rupees. Next year you have to transfer 3 lakh rupees. Yes, we'll be transferring deferred income account debit to profit and loss 3. Like that it will be done. Fine. Yeah. So now next point which I would like to do is government loan as received from the say this is the question I would like to look at. See, read the question, my dear. A Limited received a government grant or government loan for 50 lakh rupees at the rate of 5% payable at the end of the 5th year. So the prevailing market rate is equal to 12%. Okay, that means you got at a cheaper rate 5%, right? So, but compared to the market rate, there is a 7% of gap. Is 7% of gap? What is the 7% of gap? Is nothing but government grant. How do you calculate? I'll calculate. Interest is payable regularly. Yes, interest is payable regularly at the end of the each year. Then calculate the amount of government grant and pass the necessary journal entry. Yes. What do we do in this case? 50 lakh rupees is the correct. Now 50 lakh rupees is the government grant. I mean government loan amount you received. But interest is supposed to be paid at 5%. 5% means how do you pay? That is equal to 2.5 lakh, 2.5 lakh, 2.5 lakh, 2.5 lakh, 2.5 lakh for 5 years. Correct? And last year what do you pay? Last year I will pay 50 lakh rupees. Right? Now you are supposed to do the present value because it is cash you have received, account debit, to loan. Yes, you have received a government loan. Loan is a financial liability. Financial liability as per the standard should be measured at fair market value. So fair market value means I am supposed to discount it at the rate of 15%. Market rate is 15%. Correct. So let us solve. If you do that, now present value factor. Now because it's already solved here. Correct. Na? What is the number it is given here? 37 lakhs 36,000 rupees. Okay, 37 lakh 36,250 is there. What is this 37 lakh 36,000? This is the fair market value. Agree? So loan amount will be 37 lakh 36,000. Cash, what is the amount of loan you got it? You have got it 50 lakh rupees of loan. So, difference amount, what is the difference amount? That is what the deferred government grant or deferred income, that 13 lakh or 12 lakh or whatever difference balancing figure will come. That should be treated as a deferred government grant. First, you will transfer it to deferred government grant. Okay. Then afterwards, what should I do? Afterwards, correct now, where should I transfer this number? Correct now, where should I transfer this number? Listen carefully. That there is no straight away answer for that. First, one should ask a question. What is the question? Why this loan has been given to me? Accordingly, when should I transfer? What should I transfer? I will tell. Yes, listen carefully. Suppose this question. The loan is immediate relief measurement to rescue the enterprise. Okay, what did I say? The loan is correct. The loan is immediate relief measurement to rescue the enterprise. Means what? It is a special item which I spoke. If it is a special item, then this deferred government may whatever the 12 lakh or 13 lakh rupees you kept, it will be completely transferred to profit and loss immediately. Why? Means this is a special circumstance. This is not given to everybody. This is given only to your company, and that is an immediate relief under the current circumstances. Correct? That's why it is there. Second, the loan is a subsidy for staff training, and this training will happen for 4 years. That means, correct na? So the loan, whatever that 13 lakh rupees of the deferred income, what do? I will be transferring it to profit and loss. It is because I am spending the training expenditure. Correct na? My expenditure is going to happen equally for 4 years. That's why this is there. Correct na? So now what should I do? Deferred government account debit to profit and loss. Maybe it will be reduced from the expenditure, or it will be showed as an other income. Equally over the 4 years you are supposed to transfer. Then next, the loan is to finance a depreciable asset. Then what will happen? If it is directly related to a specific asset. Correct? If it is directly related to specific asset, as I discussed, there are two options. What is the first option? You reduce it. Correct? You reduce it from where, my dear? You reduce it from the asset. Correct? Or you show it as a deferred income. Correct? Now that deferred income will be transferred to P&L in the ratio of depreciation. So what will, if it is a depreciable asset, what do I say? Then we will say, correct, now deferred income account debit to the asset. Correct, now reduce the asset. Or deferred income only will be transferred to deferred income account debit to profit and loss, other income, over a period of, correct, now over a period of what? Over a period of the asset life of the asset in the ratio of depreciation will be transferring. That's all. That means directly there is no answer. Correct. Now, when do you transfer this deferred government grant? Correct. But when do you transfer it to P&L? It depends upon for what purpose the loan had been given. Hope you understood. Right? Yes, that's it. So let's close the standard Ind AS 20 now. Fine. Chalo, let us start with Ind AS 37. Okay, one important standard, because the provision word is normal. Everywhere that will continue. Okay, so and from exam point of view, directly, indirectly, impact will be there all the time. Right. So let's get into Ind AS 37, provisions, contingent liabilities, and contingent assets. Provision, contingent liability, and contingent asset. Even though heading is only 3 topics, but actually there are 3 more topics. One is onerous contract, correct na? Onerous contract. Next is reimbursement of expenses is also a topic. Next, restructuring expenditure also is one topic. So in addition to what is there on the heading, 3 more topics are also there. Okay, done. So now the question, right? Provision definition is very simple. Provision is a liability, okay, with uncertain timing or amount. Okay. What is a provision? Provision is a liability. Yes, liability with uncertain timing or amount. Yeah, not and, any one is sufficient. Uncertain timing, I don't know when I'll make a payment. Amount, how much I'll make a payment, that also I don't know. This, I have applied the maximum with respect to KSMCL, Karnataka State Mineral Corporation Limited. I was consultant for them some 2 years. Okay, mining corporation, no. Mining, cleaning will be there later. Got it, na? After some 30 or 40 years, what are you supposed to do? Once you mine, you will have a plan. What is the plan? To, what do you call, the correct terminology suddenly it will not come. Restoration. Okay, restoration plan should be there. Right. So for that, there was so much of argument, and auditor qualified. I'm a consultant, no? Right. Auditor did not understand correctly. Sometimes it happens. Right. Even you explain also that has become problem. They qualified subsequently, but it's okay. That was a big kind of adverse opinion there. If you want to see adverse opinion 40-50 pages, na, go to this company, you will get it. Okay, like yeah, seriously. So a liability with uncertain timing or amount. Yeah, problem is what? When do you dig? 40 years is not exactly 40 years. How much will you be spending for restoration? God knows. We'll tell some number. That will not be the same number after some 40 years or 50 years. Are you getting my point? So that the problem will come. Fine. Anyhow, we'll go deeper, then I'll explain you that. Yeah. So liability with uncertain timing or amount I told. Liability means, first question, liability is a present obligation. Correct, na? Present obligation arising from past event. Yes, this is first important, arising from past event. Point number 1. And settlement of which expected future economic benefits outflow. Correct. So that's why this is going to be a condition. Yes, as you know, if you want to make a provision, you have to satisfy 3 conditions. 3 conditions you are supposed to satisfy. Is it all the conditions? Yes. All the 3 conditions you have to satisfy, otherwise it is not a provision. Done. First thing, present obligation. Present means it is outstanding. It is, yes, I am liable on 31st March. Correct. Arising from past event. Past events are obligating events, I will say. What are these? Obligating events. Means which is mandatorily I have to do something. I have to settle it. I can't skip at my choice. It is making me mandatory. Obligation. mandatory. Okay, and second thing is what? Probable future economic benefits. Probable future economic benefits outflow from the entity. Correct. Probable. Probable means what? That is greater than 50 percentage, not equal to, greater than 50% chance that my money will be out. Future economic benefit. Economic means what? Money or money's worth. Okay, money or money's worth. My money is gone or something equal to my money also gone. Correct. Now, how do I settle liability? If I don't pay my car loan, that guy will take the car. That way also it's settlement. Correct. Na? Building home loan you are not paying, home he will take it. That is also repayment another way. Right. And the three can be measured reliably. Can be measured reliably. Yes. Some reliable fashion. Correct. Na? Not ad hoc fashion. It is to be reliable. Understood. Logically understood. I mean, it should make sense. It is supposed to be right. Logical manner mein it should be there. That's all is what the point. If you satisfy all the three conditions, yes, you should make a provision. Next, let me tell you from the case of mine. It may be mine, it may be many kinds of activities are there. Some companies, if you have seen, no, they must have not making provision for some of the reasons I'll tell you. Okay, this is there in IGAP, this is there in Ind AS, but still some people are not making correctly. Yeah, how I'll tell. First, mine situation, let's see. Mine, this is land. Correct. Na? The material, minerals and all may be somewhere down. Correct. Na? This is all mud, what you will see. Correct. This is the top layer. Right. First, what are you supposed to do? First, you have to reach E level. Agree or not? First, you have to dig this. Then you will start reaching the minerals. Then extraction will happen. Right. At the currently situation, maybe this may be hill. Yeah, this may be hill. This may be a flat place. That we don't know. Most of the times it will be hill and that areas only it will be. Okay. So now you have to take out all this. Hill is gone means all the environment, correct na? Birds, trees, everything will be gone. Obviously, correct na? Then so much of dust and so many things. Maybe tribal area something is there. You have to relocate them to some place. Correct. Now the question: when the government, central government, this is always central government property. Mine is not state government property. Central government only will take it on lease. Sorry, state government will take it on lease from the central government. It's like that. And it will be taken care by our government. Done. Now the question, when you extract it, what is your job? It will take, they'll have a measurement. What is the measurement? There is so much of mineral is there. Some quantity will be given. This will take some 40 years or 30 years to extract. Okay, all done. Now the question, after 40 years, what am I supposed to do? After 40 years, what am I supposed to do? First, you must have digged this. A big hole has become now. Now you have to fill it with mud, rocks, something, whatever you want to put it and make it flat. Correct. And again, this is not a small 13 to 40 site. Correct. Nah. This will be into hundreds of hectares of place. Got my point? Hundreds of hectares of place. So then what are you supposed to do? There will be, correct. Now you have to put the road. Correct. Now if the people are living there, you may need to make, what is that? So many other facilities are supposed to be done. I mean, some school also you are supposed to construct. Maintain the school for 5 years. Afterwards, you should transfer the school to government. Water facility, something should be done. Plantation should take place. Earlier it was a tree or whatever, the correct hills were there. Plantation, you should do not today I'll plant, I'll run away. No, 5 years you only have to be taking care. But you don't need to there. There are so many contractors who will take care of this job. Per acre this much karke, they will take the money for 5 years. Correct. Now you can send your supervisors in the middle and you can do. There are so many contractors for this job. Clear? Now the question. Now here what is the situation? Now when have you got the present obligation? The thing is, the minute I dig one, correct, now first started digging, to the extent I dig, do I have an obligation to fill the same thing? Yes or no? Then you are supposed to make a provision, no? Do you have present obligation? Yes. What is the past event? Digging is a event, which you did. Since you digged, obligation comes. Filling is your job. Correct na? Is it supposed to be done? Yes, mandatorily should be done. Is there any option to skip, postpone? Kuch nahi hota. Is it probable future economic benefits outflow? Pakka. When you want to fill it, you have to make payment. Correct? Na? Without paisa nahi hota. Can we measure it? Yes, why not? There are so many contractors. I can get you like per hectare how much they will charge. Filling also you don't need to do. Get it done. That's all is our job. End of the day, it should be proper. Right? Are we supposed to do provision from today onwards? Yes, mandatorily you must make a provision. And next, I'll tell you. Some companies, government, what will happen? Government will give a land. You must have seen land is for 100 years lease, 99 years, something like that, they'll tell generally. Correct, na? 99 years lease करके बोलेगा. ई land में, what do? They'll construct big plant, machinery, something like that, they will construct. Agree? Right? Rentals also what will happen? Most of the times what will happen? Lump sum amount will be paid. One shot में government को pay. First year only lump sum amount they'll pay. Okay, this is going to become what? Leasehold land. What did it become? Leasehold land. And leasehold land will generally 99 years may we will also amortize it to profit and loss. That is fine. But agreement, you read it carefully, there will be a clause all the time. In all the governments may it will be there. Okay. How I gave you? Land. Get me back land only. I don't want your machinery and plant. After 100 years, what is your job? Vacation anyhow will happen. Correct? Now you make it flat and give it to me. So that means demolition of this, is it your job or not? Mandatorily you are supposed to do. Aren't you making correct? Now when you have got the obligation, the minute I kept a brick, I have to remove the brick. Agree or not? Since keeping the brick is the past event. You constructed one wall means you have to break the wall. Understood? So are you supposed to make a provision? Yes, you have to make a provision. Then only it will happen proper. I hope you understood. Next, one more basic question will come. Sir, provision though we will credit it. Provision is credited. Debit what, sir? You understood question? Provision credited. Yes, obviously all right. Credit what? Debit what? Sorry. Is it P&L? Not all the time. That's why first question should be asked. Is the provision is directly related to? Is it directly related to? Related to what? Directly related to property, plant and equipment. Where are you making the provision? Correct, na? Or it may be even for investment property, not a problem. Question mark. Yes. If you say yes, you are not supposed to charge it off, my dear. You are supposed to capitalize. Yeah, you have to capitalize with is property, plant and equipment or investment property, whichever relevant. No, it is not related to any of these things. Correct, na? Example, warranty provision. Correct, na? Warranty provision. Example, it may be legal provision. Maybe many other related provisions will be there. Then you should charge it off to P&L first. Charge to P&L. Is it clear? First, it is directly attributable to this or not. That is important. Correct. Now, if it is capitalized to PPE, then what do you record? Then we will record like PPE account debit, then provision for restoration. Correct. Na? Provision for restoration. करके लिखेंगे. Since it is capitalized with the PPE, over the life of the PPE that will be amortized. That's all. Job is done. Hope you understand. Next point. Provision. Should we discount? All the provision should be discounted for or not? Discounting of provision. Is it must? Not must. Discounting. Present valuation. Required or not required? Mandatory choice. All provisions are only provision related to PPE. I am asking present value should be done or not? Discounting means present valuation. Should I discount for provisions are not required? Must. All the provisions. But if it is less than 12 months, then obviously materiality will be less. If it is less than something, I am going to make a payment in 12 months time. I am expecting to make a payment. Settlement will happen within 12 months time. Then don't do anything. No, correct na. If it is less than 12 months, no discounting. Okay, if it is less than 12 months, no discounting. Are you getting my point? Less than 12 months hai to discounting nahi hota. This is clear, right? Discounting from exam point of view, you don't need to break your head. They will give the rate. Generally, what do we use? Before tax, correct na, pre-tax, I'll say. Pre-tax, Government of India bond rate is sufficient. Government of India bond yield. Yield means effective rate of return. Simple words. You're getting my point? Because of the compounding impact, you will get a different rate. You understand? Which compounding? Quarterly compounding if you are doing. Annual compounding, my rate is different. Fine, doesn't matter. You don't need to break your head for this. Practically, you are supposed to think. And exam purpose, simple, they will only give. Why to worry? If they say 10%, 10% only, you also take it and follow it. Clear? Discount, is it must or not? Mandatory. Unless if it is payable, expected to be paid within 12 months. Otherwise, you have to do the discounting. Correct na? Next, how do you provision amount? How do you provision measurement? How do you do? Any methods are there? Measurement, how much? How much? Measurement means how much, basically. See, there are two methods are available, but it is not a choice. Okay, but here there is no choice. Same information you will learn it in 115 also. Ind AS 115 may also you will learn it. Remember, I'll remind you once again. Okay, two methods. What are the two methods, my dear? Any idea by chance? One is expected value method. Kya bolta? Expected value method. I think you are able to recall. Right. Next one is what? Single most likely outcome. Correct na? Most likely outcome. Single most likely outcome. Okay. Right. What is expected value? That is nothing but weighted average of all probabilities. Weighted average of all the probabilities will apply. Example, best example I would like to say, warranty I will tell. Warranty. Okay. Say example, my dear. Say I sold 1 lakh products. I sold 1 lakh units I sold. I am expecting, okay, what are you expecting? Sir, 90% is good. No claim. Kuch nahi aata. Nobody will call me. 90% mean 90,000 products related. I don't get call within 1 year time. Okay, 1 year time you can say. I hope you understood. Right. So I am not expecting anything. Right. 1 year warranty. Now, but what do I say? Out of 10%, 10% means 10,000 units का problem हो सकता. ये problem can be what kind of problem? Assume mobile, simple for understanding. What kind of problem? 10,000 units का what kind of issue? Just one software issue, sir. Our call center guy only will tell to restore, you bring it to restore settings or something. Correct. They will guide you over phone. Do like this, and matter is done. Next thing may be part replacement. Okay, my camera is bad. They will replace only camera, not the mobile. You should go give it to the customer care center. They will replace that part. They'll give you the item. This is full replacement. They are accepting my mobile is bad. They'll do it. Hello, correct? So now how do you get to know this kind of what percentage will be this kind of thing? We don't know. Na? Based on the past information, you are supposed to gather it. Sir, it is a software. Got it? Suppose assumption is what? All 10,000 units software related issue only comes. Sir, it will happen 10 lakh rupees will be my cost. Listen carefully. If all 10,000 units software replacement only if it happens. Cut. 10 lakh rupees is my cost. Some part replacement I am supposed to do. Then 45 lakh rupees I am supposed to spend. Here 100 lakh rupees I am supposed to spend. Something, whatever, some number I am keeping. Hello, correct? When is this 100 lakh rupees, my dear, will be cost? If all 10,000 units will get a replacement. Got it? Yeah. Now, what is the probability? All will never happen. All 10,000 will not come for the replacement. All will be spreaded. Now you need to apply, okay sir, this is possible, right? Some probability I have given, 0.4, 0.5, 0.1. I mean 40% possibility for software, 50% possibility for part replacement, 10% possibility for full replacement. Now you multiply this into this, okay, 4 lakh rupees. Some number will come here, some number will come here. This is my provision amount. That is what. So I have probabilities of what? Not calling is also one provision. Probability. Yes, people will come. Just an example, some 3 possibilities I have given. Again, here also part replacement, which part? Camera will cost 1 number. Correct. Now, each part will have one number. No? Classroom will not take all that. Simply example, aisa bola. Understood. So, what are the possibilities you should take? Then you go by expected value method, which is nothing but probability of weighted average of all the probabilities. Next, single most likely outcome is where my answer, correct now, where my answer is what? Yes or no. Okay, or win or lose. If my answer is yes or no, or win or lose. Say best example for this is legal case. Okay, legal case. Legal case mein, are you going to win? No, I am not going to win. Fine. And that means you are going to lose. You are going to lose means, are you supposed to make a provision? It's probable that you are going to lose. You are only telling. Yes. Is it provision must? Yes, provision is must. Correct. Now, my say example, my dear, my lawyer is telling 60% chance to lose. Okay, that means 40% to win. But do you need to make a provision? We'll make a provision. Suppose the claim amount is equal to 100 lakh rupees is the claim. The other parties, I'm losing means I have to make a payment. Demand from GST department 100 lakh, 1 crore. How much provision I should make now? Question clear? Huh? Legal case 60% lose, 40% winning capacity. Okay, right? So claim amount, demand is come for 100 lakh. Now I should make a provision for 100 lakh, 100 into 60%. 100 lakh. That's all. Your provision should be 100 lakh. Now here again, if you multiply with 60%, you have applied the weighted average. I mean again this one. Correct na? No. The minute is what is your situation? Are you going to win? Sir, I am winning, sir. Winning, sir, no provision, that's all. Winning is 40%, say 4 lakh provision karke will not ask like that. Correct na? Winning, no provision. Losing, full provision. Maybe losing chances may be 40% or 80%, that's irrelevant to me. Full amount I am supposed to make a provision for E number. Is it clear? Right? Next, important point. This is where I doubt whether they asked a question on this or not. Okay. Are you supposed to review the provision every year? Yes or no? Yeah, you have to review provision, contingent provision and contingent liability every year. Okay, what are you supposed to do? Every year review. Review means required or not required. Is it amount sufficient, not sufficient? I made a provision for 100 lakh. Today's situation 100 lakh, nothing can happen. Maybe 120 lakh is required. I hope you understood what I am saying. Correct na? You have to review. Or provision is not required. Last year I was under the impression I will lose the case. Now I am under the impression I will win the case. Got it? So that's why here review at every year end. You have to review at every year end. Both contingent liability. Maybe last year contingent liability. Current year it may be a provision. Or current year it may be provision. I mean last year it was a provision. Now it may be contingent liability. Correct? Shifting can happen. That's why. Now when you are doing the provision, review kar raha hai. Correct na? Review kar raha hai to then the right, there can be a change. Yeah, change in what? Change in two things, amma. Change in amount of provision or rate. Why rate, sir? Rate, what is the rate I told you, my dear? Government of India bond yield rate करके बोला. Correct ना? Last year I have applied Government of India bond rate, some say 6% I applied. After 3 years, Government of Bond India changed. Will it change or not? Rate of interest will keep on changing. Correct na? That's all RBI policy, they will tell. So now after 3 years there is a change. From 6% it became 7% or 5%. Possible or not? Do I need to revise my provision amount also? Yes, my dear. Even if you don't know, now know at least. Okay. One time डाल दिया, I number हो गया. हाँ नहीं है, ऐसा नहीं है. You have to review, you have to revise the number. You have to revise the number. Is it clear? Right. Listen carefully. If amount is changed means, I told you, what do you say? When I make a provision for this mine closure, correct na? Say 5 years before I made a provision. That day I thought 1 hectare को contractor will take 10 lakh rupees ले लेगा करके मैं सोचा ऐसा. Correct. But today rates are increased. Inflation has gone up something. Are you getting? Possible or not possible? Right. After 5 years when I see 10 lakh is not a number now. 15 lakh rupees को आ गया. Now I am expecting a higher provision. Hello, correct? Earlier you made a provision based on how much? 10 lakh per hectare. Correct? Now new revised number is equal to 15 lakh rupees per hectare. Agree? Right. Old number is already there sitting. 10 lakh wala. Correct? Now what should I do? 15 lakh rupees means additional provision should be made. What is the journal entry? Capitalize. That's what. Whether should I do the PPE account ko karna or P&L account ko karna debit to provision? That is the question. It is always based on the originally kaisa kiya aap. Originally I had capitalized it. Now also capitalize it. Getting my point? It is based on original accounting. Yeah, original accounting. Originally, sir, it is related to warranty. I charged it to P&L. Now also charge it to P&L. Are you clear? Right. Now listen, this is the crucial point. Suppose rate change. Old rate 6%. Now new rate 5% or 7%. It went up or down. Now here provision may be either debited or credited. Assume in my case provision is increasing. Provision credited. Debit what? This is going to become finance cost. This is the difference point to be noted. Understood? What did I say? Change in the rate. Change in the rate. Earlier Government of India discounting rate is now discount rate is new. Understood my point? If there is a change in the rate, our rate should be charged to finance cost ko charge kar. Where to charge? Finance cost, not to PPE, not to P&L as expenditure. No. Finance cost. Head is finance cost. Okay. If the amount is changing, expected amount earlier per hectare ko this much, now per hectare is different. Now this number should go to PPE or profit and loss. Understood? This will happen like this. Okay, na? Can we go ahead? Right? So, one second, let me see. Provision related. Yeah. One more point is there. Constructive obligation. क्या बोला? हाँ, constructive. Okay, constructive obligation. Right? What is constructive obligation? Any idea? Constructive obligation is self obligation. Sir, how self can be an obligation? Correct, na? Sometime question will come. Self is obligation, na? We can change your self, na? I'm not promising you, right? Self, I can say, correct, na? Today I want to sleep at 10 o'clock. I'll sleep at 11 o'clock. Anybody will come and question, na? No. I want to spend this much, I will not spend. I will spend more. Anybody can question me? Nobody can question self. But it binds you under some circumstance. Kya bola? It binds you under some circumstance. How? This must have created a goodwill. Yeah, say example, ma. I mean, companies will be, what is this? They promise. Companies do promise to employees. They send one notice. I mean, I'll pay you all of you guys Diwali bonus. Example, I'll tell. Okay, na? Diwali bonus is it as per law, na? No law says. Correct, na? Is there any ऑफर लेटर में दे दिया क्या दिवाली बोनस देता करके? नहीं दे दिया. Correct, na? So there is no contract, there is no legal, nothing is there. Correct. But I did not even announce you separately. But I paid all these years. From my incorporation to till date, every Diwali 1 month bonus I gave it to all the guys. Now tell me, shall I make a provision for the current year or not? Yes or no? Yes. Why? If you don't pay, nobody will can come and question, nobody will go to court of law. Correct, na? But will you not pay? Will pay. Why? That created a practice, business practice, whatever the way. Correct. It binds you indirectly, not directly. And again, this is one way example. Another way is what? Suppose I came to, like I was telling earlier, before this iPad, I had one, what is a Microsoft Surface I had. And that is also one kind, like this only, Surface Pro. Okay, actually 1 year is the warranty. Any, as you know, all electronics item 1 year a warranty. You don't expect more than that. More than that, you have to pay separately. Correct. So 1 year warranty. I got some problem, blue screen error, some technical issue. I don't know. Nothing, screen you can't see. You got my point. Screen only you can't see. It's all like it will become blue. Blue screen error, something is there. So somebody, what is that? Some Microsoft higher official has already told in the right. We have seen like so and so. I mean model or something like that. We have found this. With if the warranty period is within 3 years, still will replace the product. Got it? Mine, I got it after 2 years, 9 months. Okay, after 2 years, 9 months, I got it. I contacted them. You know, they only came home and picked the laptop and they served back. I mean, Microsoft Surface Pro, they brought a new one and gave it to me. That also has gone, that's a different case. But okay, yeah, but this was the fact. Where is that? They told once, na, it binds them. If they have not told, no, I would have scolded them inside only and kept quiet. Correct. Now, what to do? Unnecessarily, I paid. Yeah, those days in 1 lakh rupees approximately I paid. Yeah, it's not now. Recent 1 lakh is different, and you know, time value of money and all. No, correct. So some 10 years before 1 lakh rupees is a different number. Obviously, that time, this time you cannot correct. Na 2014, if you had paid 1 lakh, can you compare with today 1 lakh? Obviously, no. So that time only 1 lakh rupees we have paid. Within 3 years, gaya karke, obviously we will feel bad. If they have not told, na, we also cannot say anything. But they told, and if they don't do it, na, it will be suicide case. Agree or not? If they don't tell, fine. If they tell and don't do, problem. Agree or not? That's why once they say, announce it, it binds them, even though it is self-generative. That is constructive obligation. What are these? Constructive. Are you supposed to make a provision? Yes, you must make a provision. You must make a provision. Even if it is a constructive obligation, you have to make a provision. Okay, right. Discounting is everywhere, my dear. There is no choice in this case. Fine. Right. Right. That's it. With respect to contingent liability, that is the important, I mean, all the important points of the standard covered. Contingent liability. Contingent liability is what? Contingent liability is a possible obligation. There are actually two definitions are there. Right. Generally, what the student does, na, some small basic mistake, it happens knowingly, unknowingly. Is it a provision required? Question will come. What you will say? Provision is not required, you will tell. Fine. If you stop there, then you will lose some half mark or 1 mark. Why? Immediate next sentence should come. You should show a way, closure. They didn't know. Got my point? What is that? You should say provision is not required because there is no probable future economic benefit outflow. But what are you supposed to do? Yeah, you should create a contingent liability. Correct now. What is that supposed to be done? Contingent liability disclosure. Contingent liability will be disclosed. Right. Where provision is not required. Where provision is not required. Correct now. And not remote. Remote means what? Occurrence is like less than 10% chance. Very rare chance. Then don't do it. Otherwise, you are supposed to disclose it. One question I'll ask. Somebody asked. Some financial statements of some company, they did it. Okay, that's where I also got doubt. Right, it's 100% wrong, but fine. They have done the present value even for this. Who asked your present valuation for this? Nonsense. Present value for contingent liability, na? No, man. Correct, na? Next. Whatever the amount the other party is claiming, for the entire amount you are supposed to give. Entire claim. Entire claim. Maybe you are not acknowledging it as a debt. Doesn't matter. Entire claim should be. Suppose GST department sent you notice for 100 crore. 100 crore likho yaar, that's all. You should not multiply with probability, should not multiply with present valuation and all. Same number as it is. Control C, Control V. That's it. Clear? Right. Contingent asset, I will take you through. One good question has come in contingent asset ka related. Okay. Contingent asset, first of all, right? Situation, there will be three situations, my dear. Definition is simple. Possible asset arising from past event, existence of which will be confirmed by occurrence or non-occurrence of one or more future events. Whether it will come, will not come, I don't know. That depends upon the future. Okay, but possible asset. Question. Question is what? Is it possible asset? Contingent asset. Is it possible? Means what? Discretionary of the other party. क्या बोला? मैं files application submit किया. You are a government officer. It depends on your government officer wish and will. If he wants, he will give money. Otherwise, he will not. Discretionary of the other party. Now, is it contingency to me or not? पक्का करके बोल सकता क्या? I cannot tell पक्का. It is depends on him. Contingent, that is. Possible. Possible है तो what? No disclosure, no recognition. Both not required. Remember this. Next. Sir, it is probable. Then disclose. Only disclosure. In notes, not in the board. Notes. Notes में disclose करो. The certain. Virtually certain. Yeah, then why is contingent? Record asset, that's all. In the recent past, I mean, not very, I mean, somewhere, some 2-3 years before, okay, there was a question. What was the question, you know? Instead of going to the question, I will tell you the concept of what is there in the question. That is better. It will save time for us. See, if you application should be filed by the application with the government. Okay. By what date? By 31st March 2020-25, you have to file the application. For what? For grant. For a grant. Getting my point? Right? So 31st March 2025 May, you should file the application. Then they will give you the, you are eligible, they will give you the things. Getting my point? Right. But what has happened? Our party has filed on 1/4/2025. Late ho gaya. Delayed application kiya. And it says what? Once you file this, still there is like pakka will not come is secondary. It says like government officer ka discretionary. Okay, it is in the hands of the government officer. If he wish, he will give. Otherwise, he will not give. correct? So now, but criteria I have satisfied as on 31st March 25 only. I have satisfied the criteria, but I have not filed as on 31st March 25. Now what should I show? It is a contingent asset. Not probable. That's different. No, contingent asset or not. A possible asset. Whether you show, do not show, that is depending upon this. Okay, I am telling first definition, does it satisfy? Is it a possible asset? Yeah, depends upon what? Discretionary of the officer. It may come, may not come. Got it? Then you tell, is it do you feel it is a probable? Do you feel it is possible? Karke, don't judge it. Many times, don't disclose. This is very wrong way. Right? How do you know possible or probable? You don't know. No. Write both. One more line you will write. That's all. Na. What's your problem? You got my point? If it is possible, don't disclose. If it is probable, correct? Let the management discuss. Yeah, think about it. Correct? Na? They may give some bribe, then it will become more probable. Correct? How do you know? Right? It happens. Na? Many times it happens. Because discretionary of the other party means bribe point, that is. Got it? So it may become more probable. That's why they want to show it as disclosure. That's all. Write both. There are two possibilities are there. Both possibilities you write. Certain nahi hota. Till the order comes from that guy, you cannot tell that certain करके नहीं बोल सकता. It will fall under first two categories only. Is this clear? इधे question asked. Obviously dates and something, some 4 lines before, 4 lines back, and middle में that you know, right? That's normal way. Fine. Right. Next, onerous contract is something important. Onerous contract. This very crucial. Onerous contracts come from where, my dear? These things will come from binding contracts, binding agreements, binding contracts. Bind means you don't have option to take back. Withdrawal का option नहीं है. It binds. I sell goods to, I sell my building to you means agreement में किया तो I have to sell, you have to buy. Understand? At least, right? In the worst case scenario, okay, other party went into insolvency, where will he buy? Okay, then at the extreme end, don't think. Normally, I am thinking. Okay, na? Extreme thinking not required here. Normally, I sell means I should sell, you have to buy. Otherwise, you can go to court of law. As per the agreement, you told. So, you have to. Right. Binding contracts. So, majorly, all major construction, correct? Na? Major construction agreements are binding only, my dear. Example, metro construction, national highway, bridges, all these construction activities, 99.9% big buildings. Not small things, it will not be there. Correct. Now, you are constructing, say, example, some prestige wala, big one you are constructing. Fine. If he says all of a sudden, prestige won't construct, prestige only brand. Got it? Who constructs, subcontractor will do all the job. Never they will do. There are so many subcontractors will be there for this. Okay. So they cannot say in the middle, they cannot say what? I am not constructing, buy. No, you cannot tell like that. Correct. Now, metro also, if you do like that, what is the position of the government? You can come and ask for escalation clause rakho. If the prices goes up, yes, you come, fight, get your money and take it. Correct. Now, that's always welcome. That is different. You cannot say all of the sudden middle mein you cannot go. That's a problem. Okay. Right. So, binding contracts mein kya hota? Two things. Sometimes what happens, you already accept it. Correct? You cannot withdraw. If I continue, pakka I am going to get loss. What is that? If I continue to complete the project, pakka I am going to get the loss. Right? Then what the standard says? First thing. What is the loss if continued? Sir, if I continue is equal to 100 crore rupees, loss will come. If I continue, complete it. Second thing. If I cancel it, assume there is a chance to cancel. If there is any. What is the penalty to? Penalty. Kitna pay karna? Sir, penalty is equal to 40 CR. What do you do? 40 CR you pay and come out. Nothing wrong. So whichever is low, that you need to make a provision. If I continue, the options will be two: pay the money and get lost. Correct? Or continue. That's all. Na? If I continue, what is the loss I'm expecting to make? A number. Or if there is a way out, for penalty you pay and leave. 40 crore rupees penalty, whichever is lower, you have to make a provision for that. Why, sir? It is a binding agreement. You don't have a way to come out of the loss. You're getting my point? Yes, even though my loss is going to happen over the next 2-3 years, still you should make a provision for such loss now, not over the remaining period. Is it clear? Kya bola? Even though I am going to make a loss over the next 2-3 years, but you should make entire loss should be booked in the right. So this provision immediately, how much? 100%. Okay, no deferment. You have to book 100% provision immediately. Understand? Simple example I'll tell you. Okay, one company has taken one factory on rent. You can call that is not a factory. That's one kind of facility. It's okay, whatever. Factory for understanding. Factory they have taken it on rent. Okay, yeah, factory per annum is equal to some number 10 lakh rupees. I'll keep it. Okay, it's a simple number just for understanding. It's a big number. Binding agreement for 4 years, 4 years, not a big period. Okay, fine. You understood my point, right? After 2 years, what has happened? No, some problem with not with the problem with the factory. Problem is with the market. I'm not able to produce. I mean, even if I produce, nobody is purchasing. Why should I produce? Got it? Right. They, I mean, as a call from the group company level itself, they took a decision. Let's stop. Don't produce from there. Correct now? Don't produce. But what about the rent? They're asking vacate. Send all the employees to whomever you can use it, them to take it. Other people ko lay off karo. Whatever you want to pay them, pay off. Correct now? What to do? Their problem, their problem. Fine. Right. Right or wrong is not our discussion right now. They throw some people out. Some people ko they used in other departments. Okay. Now factory also they are saying I'm surrendering factory. But what are you supposed to do? You was to make a provision. I mean, it is surrendering has happened after that is 30th September or somewhere like that. Decision has already happened on March or February. I mean, decision took place. What is the decision? Decision to stop. Immediately stop the production. Subsequently, also we got very clearly information is already there. Decision is already taken. Na? Then what are you supposed to do? You provide no 2 more years ka rent you are supposed to pay. There is no penalty in that agreement. Cancellation का penalty नहीं है. Correct ना? 20 lakh rupees को penalty 20 lakh rupees का you have to mandatorily pay. Correct na? And how do we do this one? 20 lakh का 10 lakh rupees into present value factor करना for first year. Another 10 lakh rupees in the second year factor को apply करो. Correct na? E number you are supposed to make a provision. Not 20 lakh rupees straight away. 20 lakh rupees is a undiscounted value. Correct? Have you understood? Right. What are you supposed to do? Say if you say 10%, 10% hai to what are you supposed to do? 0.909 that is equal to 9 point, correct na? 0.826. 826 hai to 8.26 something will come, right? So 9 plus 7 is to 17, correct na? It's okay. 17.35 something like that number will come. Agree? 17.35 should be provided. What is the journal entry today? Is it related to PPE na? Huh? No, it is not my PPE, no, somebody's PPE. This is taken it on rent. Hello, correct? That's what to debit. Generally question will come. That's why I answered first only what to debit. Is it related to PPE? No, it is gone asset. I'm not going to use it. So charge it off. Correct na? Whatever loss, P&L account, debit, whichever name you think and write it. No, we don't care. Correct na? To provision. So 17.35, 17.35. Agree? Yeah? The next what? At the end of the first year, some people will continue to hold it and they'll pay rent over the 2 years. Some people, what do they say? They can bargain and they can pay it at a lesser money and close it. It always happens. Right. Here assumption is what? I will not. Why should I close this? Anyhow, I have to pay you. I'll pay you now. After 1 year, I should pay. Well, I'll come and pay. Wait, what is your problem? Wait. Got it? Right. So here in my example, we agreed to continue to pay. We'll pay. Now, this is called unwinding. What is it called? Unwinding. Unwinding means what will happen? 17.35 ko plus 10% is issued to. Correct. Now, plus 10% means again, what is this unwinding cost? That is nothing but finance cost account debit to provision. Correct. Now, how much? 1.735 ko karna. Hello, correct? 1.735. Next, at the end of the first year, are you supposed to pay 10 lakh or not? Yes. So then provision account debit to cash 10 lakh rupees, I will clear it. Then balance on the balance amount, once again unwinding cost in year 2 it will happen. Then it will come to 10 lakh rupees. You will make a payment. I hope it is clear. Right. That is what? Again, restructuring provision. Here also restructuring provision, when I say restructuring provision, correct na? What do you mean by restructuring? Restructure means it's a program designed and approved by the management for what? For change in the scope of business. Okay, means earlier or the style of business, earlier what I was doing, now what I am doing. Yeah, it may lead to a merger, it may lead to demerger. Okay, it may be closure of what? Closure of a factory. Okay, closure of a factory. You wanted to close it off, not a problem. Factory, correct na? Yeah, all these kinds of things will be coming part and parcel of restructuring. The restructuring hai to kuch, I mean, do I need to take any provision ka different? No, my dear. Provision means same three conditions you are supposed to satisfy. Same. Is it a present obligation arising from past event? Probable future economic benefits outflow? Okay. And can it be measured reliably? If you say all, done, you are supposed to make a provision. Suppose because of the restructure, suppose layoff is there. Layoff. Okay. Right. When have you announced? Sir, I have announced in the month of February 25. Okay. What we said? Like by June, whoever is continued with me, you work with me till June. You work with me till June. I'll pay you salary till June plus some 3 months salary also extra I will pay. When I'm sending you out, I'll pay you 3 months salary. In 3 months you search and get another job. Are you getting my point? Is it clear? Now tell me, when is it announced? February. Correct now. When is the actual payment will happen? June. Correct now. Is it a legal obligation? Nowhere, there is no law. When you are sending them, you need to give a notice, basically. If my company is sending you out, na, suppose what is the amount of notice I am collecting from you? Say 2 months notice you should give. Same way, I also should give 2 months notice. That's all. I don't need to make any payment. If any company is paying you, means they are good guys. That's all. That's it. Gratuity and all normal. That is as per the act it will come. For the layoff, no. Nobody needs to pay. What you are getting means your company is at least giving you something. Some companies, if they don't have money, what do they do? They give a notice and they'll ask you to leave after certain time. That's all. Understood? Now, should I make a provision? It is not legal obligation, neither a contractual obligation. Correct? Huh? Right. Now, constructive obligation. Who wants you to pay 3 lakh? 3 months salary? Nobody. Self decided. Constructive obligation. Shall I make a provision? Yes. When you announced? Before March, after March, before, after? Before. Then it binds you. Okay. Now question, why provision? Yeah, because maybe 100 guys or 1000 guys are sitting today, February. Do you think you will pay for all 1000 guys? Not necessarily. Why means some guys must have got the job in between only and jumped. Obviously, no. You get to know, like say after 4 months he'll throw you out. Will you just wait for till the 3 months salary के लिए क्या? No, na. You will immediately you will upload resume. Correct na. If you got a good offer, April में आ गया, what you will do? You will try to convince your other party. I'll come in June. If he's accepting, fine. You will take E3 months salary also. There also you will join. That's a different case. Correct na. If he's not accepting, hereby and jump. Correct na. Obviously, be an employee and ask. Think no. That's all. Anybody does the same thing. That's how it happens. So now approximately you have to guess approximately how many number of employees will be there. 70% will be there, sir. 30% jump, sir. Some number estimation. No actual number impossible. Actual only future will tell. Correct, na? Right? Because 1000 employees may which employee will go, which employee will not go. How do I know here? That's why 100% estimation. But provision is must as on 31st March. It is a constructive obligation. It is a constructive obligation. Any question from the standard? What I was asking KSMCL में, I mean some other company में, the writer was saying, here I was telling, no, how old was happened, change in the amount. The example what it has happened, change in the amount took place. Earlier they estimated for one number, now estimate for another number. He is telling I said very clearly, no, it has to go to PPE. He is telling, no, you should charge it to P&L. I was not listening in the sense, I said I will show you PwC guidance, KPMG guidance, whichever guidance in the world I will show you. Standard में नहीं है यार, I know that. Standard में every item का of the correct ना, every situation का, every item का standard लिखना है तो ना, it is right now already 3000 pages are there. Then you should make it 30,000 or 3 lakh pages you should make. Correct na? Every item standard में where is it means how it will be there. If everything is there in the standard, then why you and me are chartered accountants here? That is also there na. Then we have to think, discuss, openness should be required, na? Right. And again, some big four have done in the sense what already brainstorming must have happened at a very higher level. It's not like one big four and all the people are telling same answer. Right. Other than that, I also cannot. That is the only logical thing. Amount changing and rate changing, there is a difference. You have to understand that and you have to account. Okay. But actually standard में नहीं है, इसका बात ही नहीं है. But practically that only will come. Standard will tell only one thing, review करके बोलेगा. Review करके क्या account करना नहीं बोलेगा. You understood? That's the issue. That is the issue. Everything cannot be discussed by the standard. It's very difficult, not possible. They can discuss, but I told na, 3000 pages will become 30,000 minimum. Right. Chalo. Ind AS 23. Ind AS 23. Borrowing cost. Yeah. This is another a good standard. Okay. Yeah. Here majorly, na, I mean about the what do you call what do I say? Not at the starting point. 1 second. Yeah, borrowing cost. The standard is very simple. Whether should I capitalize or charge it to P&L? Correct, na? Whether should I capitalize? Whether borrowing cost should be capitalized with some other asset, right? Or charge it to profit and loss as a finance cost. That's all. Right. Borrowing cost means what, sir? First line it will tell EIR, effective rate of interest. Okay, the minute it says effective rate of interest means you already taken care of processing fees, discount or premium and redemption and issue, everything is taken care. Are getting my point? What EIR means, what is that you have already taken? You have taken the processing fees. Yes. You must have taken the brokerage. You must have taken the discount on issue, correct na? And you must have considered the premium on redemption. Yes, you have already taken care of all these things under EIR, effective rate of interest or effective interest rate mein you already taken care, correct? And the second bit is with respect to leases. With respect to leases, in the sense it's a little different wala, okay? Practically where you will see is less option is available, okay? I'll give you a situation, you will understand that, okay? Leases related means, you know, imagine karo, practically finding this may be very less possible. Possible, obviously, without possible they will not keep the line only. Since it is possible, they must have kept, correct na? Suppose there is one big factory ma. This is a big factory, okay? You are taking one machine. This machine you have taken it on lease. You have taken it on lease. I am installing or constructing this entire factory. Factory is my qualifying asset. What is factory is a qualifying, because it takes a lot of time for me to start. E item I have taken it on lease. So then what you will become? You will become a lessee to this asset. Lessee hai to obviously lease liability will come into the picture. Ind AS 116 lease ROUA account asset and lease liability you must have heard, correct na? When it is a lease liability, every time when you repay, whenever you make a installment payment, will there be interest element in this? Yes or no? Interest and principal is going to be bifurcated and accounted for. Agree or not? Exactly. It happens like that. Correct na? Now the question is, E interest is what we are talking, borrowing cost. Now listen carefully. In this factory, E factory may be taking 3 years time to do the installation, completion. Okay. This asset I bought it on day 1. I kept it. Okay, but I could not use it. Why you could not use it? E asset is linked to so many other assets. Se link ho gaya. You can use it when, along with all other assets, you can use it. You cannot use it only one. Are you getting my point? Asset independently ready, but you cannot use it independently because it has to be combined with so many other machines in the factory. Hello, understood? Now, during this construction period of 3 years, whatever the interest comes out of in the lease payment, whatever the lease installments, when you make a payment, there is an interest element. Our interest element also should be capitalized to the factory. That's the situation it comes. You understood? Normally, any asset, if you have taken it on lease, that must be ready to use. That is, suppose if you take a car must be ready to use only, na? Then only you will take it on lease. Building I am taking on lease means it is already ready, man. Correct na? Laptop I am taking it on lease. Yeah, laptop is ready. I can switch on and start using. Correct. It may take a day or two to install the software. That's all. It's ready. Are you following me? Right. Here also ready. But the problem is it is combined with so many other assets. That's why I am not able to use it. That's where the interest element. That's why generally interest element will be charged to P&L on lease situation. This is something extreme circumstance where it can be capitalized. Hope you understood. Right. That is a rare circumstance. Correct. Now, which you may not see in lifetime. It's different one. And the third bit, what is borrowing cost? One is effective rate of interest. This is leases में interest element in the lease liability. An interest element in the lease liability should be capitalized subject to this Ind AS 23. Next is foreign currency exchange difference. Okay, to the extent on the foreign currency on FV, sorry, one second, on FCB, you write foreign currency borrowing, foreign currency exchange difference on foreign currency borrowing to the extent regarded as borrowing cost. To the extent regarded as borrowing cost. Okay, the concept is same as per accounting standard and this. But to give a small idea, okay, this is what something crucial. Rest of the things will be only what is that? Specific rate or general borrowing. So general average rate. And one small point, some amendment has come. I doubt whether they have not tested so far that amendment. Okay, someday when they want to write a new question, they may pick. If they want to give past exam question, same question only they want to give, obviously they will not. Okay, right. Chalo. But your paper, no? Last 3-4 attempts may they have not applied brain. Picked the questions and given same. They should create a question, isn't it? That's not happening. That level. But some, I know they'll screw up. If not from FR, from other thing, they'll be screwing it up. Their target may be one attempt to one subject. They'll correct, no? That you know. One time they will screw up auditing. One time SFM. Some other time FR. Right? Yeah. So foreign currency exchange difference on the foreign currency borrowing to the extent regarded as borrowing cost. What is this? Any idea? This we have seen recently in one company. This is German based company. Okay, they were constructing one big pharma factory. Okay, you know this any tablet Dolo, you know, example. Okay, tablet is there. That is a chemical. Powder will be there. Some chemical powder will be there. How will that come to a good shape of one tablet? Tablet use obviously all of you correct now. It's hard. If you want to break it, you can break it. That's different. It's hard obviously, and you got a shape exactly. You understood? Exactly a shape में आना तो means what? A normal powder को water एक 2 drops will put and you cannot make it. You understood my point? So what this company does? What is it called? Not mold. Mold will give shape. These guys also will manufacture a powder. A powder will be merged, I mean, mix it with this chemical powder. That will be as a joint, binding joint, I can say. Binding agent. Can I use the word binding agent? Maybe the right term. Binding agent. Understood? Means it will work like a gum. You understand my point? So medicine will be 75%. A 25% will be whatever powder I manufacture. They'll mix it. Got it? And now if you press, because this has the I mean gum kind of quality will be there. Correct? Then it will give you a shape. Perfect shape. A drop में नहीं होता. I mean water में नहीं होता. And that should be neutral. You understood? I can't mix with something else. It should be, because reaction should not be there. I hope you understood. Because it's a chemical, na? And this also some other chemical, no? Blast हो जाएगा in stomach, right? So that shouldn't be there. That's why this should be neutral. Neutral means it should not reduce the power of the Dolo medicine. Ka power B should not be reduced. Nothing should be there. Powder is what manufactured. So this powder is required for every company. Agree or not? Whoever is manufacturing tablet means required. Correct, na? Tube to not required, but tablet form to mandatory required. Yeah, there are many companies, not many companies, but this company, German company, basically. They have sent some 110 crore rupees to India for constructing one factory here. Done. That is in euro. Correct na? India rupees. Yes, you have to pay, rates and all will be different. Now the question, correct na? So now you have taken say $10,000 of $10,000 I'll say simple example के लिए loan ले लिया. This is foreign currency borrowing. $10,000 money you have taken. At what rate, sir? At say 4% per annum rate. Per annum I should pay, assume. But Indian bank, okay, what is my bank is what, sir? My bank is SBI bank, sir. Okay, SBI say loan liya to what is the rate? Say 7% is normal rate. Correct ना? But other party is giving me rate at 4% में दे रहे, right? So now what are we supposed to do? Right, what is the borrowing cost here? Normal borrowing cost is, right, which date of loan? Date of loan say 1/4/2024 I'll give. Right, today sir $1 is equal to 80 rupees. एक number ले लेंगे. Okay, so what do you say today? Today you got the loan, so cash account debit to loan. Correct na? 80 into 10,000, whatever, 8 lakh rupees will come. Correct, 8 lakh rupees here I will record it. Done. Now 31st March 2025, $1 is equal to 82 rupees it has become. Okay, principal I don't pay, but interest I should pay or not? Yes, what is the interest money? Interest is equal to $10,000, correct na, into 4%. Comes to how much here? $400 will come. Agree? Right, and interest payment, how much am I supposed to make a payment? That is equal to $400, it's in dollars, that into 82. How much does it come? Calculator. 32. 800 rupees will be my payment. Is this a borrowing cost? Yes. Is it related to my factory? Yes. Factory is a qualifying asset? Yes. So what do? Capitalize it. Agree? Right. At the same time, loan is a monetary item. Loan is what? Monetary item. Agree? So are you supposed to restate the loan? Are you supposed to restate it? Yes, you must restate it. When you are supposed to restate it, what are you supposed to do, my dear? Closing rate you are supposed to take, correct na? So that means what should I do? That $10,000 into 82 minus 80, correct na? 2 rupees. 2 rupees means 20,000 rupees should be generally forex to P&L, correct na? It should be forex charge, it will be transferred to P&L. Am I right? Right. But what is your actual? But what are you supposed to do in this case? If I had borrowed in India, correct na? If I had borrowed 8 lakh rupees, I would have borrowed. 8 lakh into 7% will be 56,000 rupees I would have paid the interest. Agree? But you have capitalizing how much? 32,800. Correct na? What is the total amount here? Actually, total is equal to 52,800 only na? What the standard says, up to 56,000. Kya bola? Otherwise, I'll make the small change, I'll make it. I'll bring it to 6% ko I'll bring it. What is that? 6%. When I bring it to 6%, 8 lakh into 6% is kitna ma? 6% means 48,000 rupees it is supposed to be. Up to 48,000 rupees cost should be capitalized. What did I say? Up to 48. Up to 48 means up to 48,000. You already capitalized 32,800. Correct. Na? So what is the balancing figure? 15,200. Correct. Na? 15,200 you capitalize it. But actually out of how much? Out of 20,000 may 15,200 will be capitalized. This 4,800 will be your forex loss. Like this you are supposed to compute it. My question now. Okay, right. Suppose in the current year 82 I brought, correct na? Suppose 82 plus me 78 came, then it's a forex gain, correct? Yeah, correct. Now initially you recorded loan, you recorded at 80. Now it has become 78. Means 2 rupees, 20,000 rupees is a gain. Then what do you do? Huh? Deduct from 33,000 to 32,800. It's a gain. Yeah, I wrote gain, forex gain only I wrote. Same year only assume. That's all. You will capitalize only 32,800. This gain 20,000 rupees will be transferred to P&L. Okay, next question. This is question number 1. Question number 2. Okay, current year you capitalize 15,200. Agree? Yeah? Yeah, next year. Next year you got 10,000 rupees gain. Now you adjust it. You understood? Adjust in the sense you 15 up to correct up to 15,000 whatever amount you have got a gain, correct now. Since it is not yet capitalized, it's going on, qualifying asset is going on, you take the adjustment. Okay na? Right. One more question, right? Practically it may be relevant to you. This you understood, huh? To the extent of 15,200 you can adjust it, right? Now question is, I have taken loan 100 CR loan, whatever it is, same loan I have taken, but it is not for a qualifying asset. Same situation you take it. It is not for a qualifying asset. Now what will be our treatment for 15,200? Will there be such treatment or no treatment? Is the question clear? I repeat once again. In my example I gave, I took a loan for a factory. Factory is a qualifying asset, I told. Correct na? That's the capitalization sentences came. Suppose this is not for a factory. Correct? So no capitalization word will come. That time also do I need to calculate like this or not required? Question clear now at least? What did I say? Loan is not meant for qualifying asset. Now what? Still do I need to do or not required to do? Working capital loan, कुछ loan हो सकता है ना, not necessary for not, as a forex loss. Not correct. It should go as a finance cost, charge to P&L. But bifurcation of finance cost and forex loss has to take place. It should not be charged under 21, it should be charged under 23. Is it clear? Even if it is not a qualifying asset, the bifurcation calculation has to happen. Because he said borrowing cost definition includes foreign exchange different to the extent it is considered as. So to the extent of 15,000, to the extent of, correct na, what did I say? To the extent of 15,000, yeah, to the extent of 15,200 will be treated as a finance cost and charged to P&L. Don't capitalize but should be charged to P&L. Is that clear? Right, that is one of the major point. Right, next important point in the standard, if you ask me, correct na? I'll tell you amendment, something I was telling na. Yes, the amendment may listen carefully. As you know, borrowings are of two types in the standard, correct? Borrowings are of two types. What are the two types, my dear? One is specific borrowing, then the general borrowing, correct na? Specific borrowing ko what you will do? You will take specific rate, correct na? General borrowing ko what you will apply? Weighted average rate. That is called capitalization rate, and that thing what weighted average borrowing rate will apply. Agree na? Right. Now the question is, right here I will tell you. Specific rate may only, specific rate may what happens na? What is the interest amount you have incurred are paid, what borrow, incurred basically, right, word is incurred, correct, minus any interest received, correct, minus what, any interest received on what, on idle funds, ideally idle funds. Okay, you have got some idle funds, that's why you kept it in FD, correct, right, this is the balance, this balance you are supposed to capitalize it, this you must have studied, correct, clear. Remember again, point to be noted, interest on idle funds, no, a concept doesn't exist for general funds, that is only for specific. Okay, right. Here general, if it is idle cannot be how, but because it's not meant for the qualifying asset, it must have been used for some other purpose. That's all. You have not used me, that is your problem. Will not deal with it. Got it? Right. Point number 1, adu clear. Now the question is, I'll tell you. Listen carefully. This is my balance sheet. Okay. I have a specific loan. I have specific loan. Okay. So example, some 1000 rupees is there. I have general borrowing. That is some 4000 rupees also is there. Okay, right. With respect to this building, building 1, it is constructed. Okay, normally suppose when you get the money, what do? You will try to repay this or this, whatever, something you will repay, correct na? And when you want a loan, again you may take a loan. If required, you will take it, otherwise you will not take it, correct na? Now the question is here, this will take a little time to understand, but for your focus is important. Okay, sometimes me choosing words also will be difficult. Fine. What do I say? Building 1 is ready, ma. Building 1 is ready, correct na? Building 1 is ready. Now obviously interest will be charged to profit and loss, it will not be capitalized, that you know, when cessation, when you will say this, when the building is ready for its expected usage, then from then onwards interest will be charged to P&L rather than capitalizing with the asset. Agree? Right. Once this is ready, now you are constructing another number, building number 2. Kya bola? Building 2 construction. But do you have already loan existing in the balance sheet still? Hello? Correct na? Situation you understood na? Building 1 is ready ya under construction? Ready. Building 2 starting. Starting. Okay, not under construction. Now for building number 2, you should consider E loan as a general borrowing. Building number 2 के लिए but question, I mean situation I have given, correct question, situation I have given, but you should remember the question. Building number 1 is ready na, yet to be ready na, adu remember. Building number 2 started. From the building point of view, now our loan is not specific loan, that is specific to building 1. So I can't calculate a specific loan. Now it should be considered as a general borrowing. Mean for calculation of your weighted average rate, you should take 1000 rupees also into your calculation. This is the amendment in this standard. Clear? Right. Our point related, let's take the one small question. Somewhere I gave, I think, not very. Yeah, I have written some page numbers here. Our page number, I don't know, not matching with E number, that is a problem. E question, you read it. Hope this is the right one. If not, I'll search for another one. Okay, on 1st April 2021, A Limited took a 8% loan for 50 lakh rupees for construction of building A, which is repayable after 6 years. Loan still there, correct na? Loan maybe for 20, house loan will take, sir, 25 years will take. House to ready in 2 years. Correct na? Loan house don't look at, other than separate items. The construction of building was completed on 31st March 2023. Yes, 22 years में खत्म हो गया. Fine, excellent. A started constructing a new building B. Understood? New building, that is over. When started? 23-24. Correct na? 23 में already 22-23 में खत्म, 23 new building has started. For which used its existing borrowing. Correct. Already I have borrowed na 50 lakh rupees hai, general borrowing hai. Already general purpose loan also is there. He has outstanding general purpose 25 lakh rupees also is there. Interest on which is payable 9%, and 15 lakh rupees one more general borrowing is there 7%. Right? Is it the same situation what I told you? Exactly matching. Correct na? Now what should I say? Normally what you would have done na, ये loan separate है, उसको delete करेगा आप. For calculation of your weighted average purpose, you would have not considered the 50 lakh wala. Agree? Yeah. But now situation is different. Situation क्या करना? 50 lakh, 15 lakh, 25 lakh, all take it and do it calculation. Understood? So what is the interest will come now? Here calculation, I mean if I do calculate, what will come, my dear? 50 lakh का कितना rate calculate करना ना? 50 lakh into 8% is that is equal to 4 lakh. Next क्या बोलो? 25 lakh rupees 9% में. Okay, 2.25. This is equal to 25 lakh. The next 15 lakh rupees loan 7%. 1 lakh? 1.05. Total karo, E side, A side, both. This is equal to 40 means 90. This is 8.8. How? 7 point, no? 7.30. Correct, no? 7.3 divided by 90 into 100. Because dates and all he has not given. So I am taking full year available. 8.11%. This is my weighted average borrowing rate. That's all. Yes, if the specific borrowing was not repaid, once the relevant qualifying asset was completed, lines, they become general borrowing for as long as they are outstanding. Okay. So the borrowing costs that are directly attributable to obtaining qualifying assets are this one. Okay. So thus borrowing cost could be avoided. Whatever. What we have calculated, paragraph you read it later, but 8.11 will be your weighted average. So be careful. I mean, if you are not aware of this amendment, na, you might have done mistake, but you don't know that you did a mistake also. Do you understand my point? Correct. Obviously, what you will do? Hey, that is related to building A or chodo. We are calculating for building B. Building B ka only do loan hai. That's where error can happen. Understood? Yeah. This is not, I mean, not very recently, but yes, it is there. Right. E question will solve it and we'll close it. Yeah. Padma Limited is constructing a plant and expenditure till 31st March 2021, 50 lakh. The following are general borrowings as on 31st March 2020. General borrowings. All are general borrowings. Rates are there. Generally, if they give the dates different, then we have to calculate it for the per annum base. We will calculate and then do the things. Correct, na? Right. If they have not given any dates specific, assume full year it is there. That's all. That is only when I don't know what should I do. Correct, na? When he has taken loan, he should give me the information. If he has not given, loan is existing throughout the period. Done. Okay, right. So 80 plus 20 plus 50, that's fine. Loans. The accountant of the company has not capitalized any interest. There is no specific borrowing. Okay, he doesn't know the subject. Is he correct? Obviously wrong. If no, what amount should I capitalize? We'll calculate and give. Correct. Straight away 10% into 80, that is equal to 8 lakh. 12% into 20, that is equal to 2.4 lakh. 9% into 9 means 4.5, huh? Correct, na? 4.5. How much does it come? Is it 10? 10 plus 14.9. Correct, na? Divided by 150 into 100. How much? 9 point? 9.99 something, that is equal to 10%. 150, now 150 into 10% is 15. No? 14.9 means somewhere towards the end. That's what. So, what is the rate here? 9.93. That's fine. 10% I just rounded off. Fine. So, 9.93 should be your interest to be calculated. That should be the amount capitalized. And you should say, what is the amount to be charged to P&L? Yeah, your interest has come to how much? E number, correct, 9.93, and this total number has come to 14.9. But how much you out of this 150 amount, you use the money for what number? Only 50 lakh rupees only used. Na? When 50 is available, out of that 50 only is gone. So 50 lakh into 9.93 percentage, if I apply, how much does it come? 4.965. That amount should be capitalized. But totally you incurred how much? 4.9. 14.9. 14.9 minus 4.9. That means 10 will come around, just number. 10 will be charged to profit and loss statement. That's correct, na? 10 will be charged to P&L. Like that, you need to consider. One mistake they are doing in the right. If you have taken working capital loan is there in the balance sheet. Where is it? Working capital loan is there in the balance sheet. Should I consider that also for the general purpose borrowing or not? Question clear? Yeah, in the balance sheet, working capital loan is there. All borrowings will be considered. In IPCC, I think they said they're not considering. Where is it said? Borrowing cost, all borrowings only you told. Never you told long or short. Seriously, no. You should consider. Okay, that is to be considered. One more is there. Any prepayment charges, should I capitalize, should I consider or not? Prepayment. Prepayment charges. You know, guys, prepayment means, you know, na? If you settle the debt early, what will happen? You will get bonus, huh? You will not get gift. They will give you charge. Correct, extra charge. They'll waive off for a small loans, maybe a crore or 2 crores, something like that. I mean, residential property ke liye kiya, so they will, most of the times they will waive off. Okay, from the beginning only they will tell, if you prepay, we will not charge you. But big loans will be there. Suddenly 100 crores or 200 crores, something like that. Suddenly, you got my point. You took 200 crores money. Otherwise, I took 200 crores from you. You are a banker. Okay. I sold my factory, that's why I got 250 crores. I thought I'll pay you right now. I'll bring money 200 crores and I'll give it to you. You never planned how to distribute this for another. You have to search one more person like me, no? Till you search, correct, na? Till you search, you don't get to find any interest loss for you, na? You must have collected the deposit money from other people. Then who will pay that balance money? If it is a planned money, na, then I know every year Ravi Kanth will pay 1 crore, something like that. Then I know 1 crore will come. Then I should find another person, and they will call, do you want loan karke? Correct, they will find one more party, distribute karo, at least gap will be low. 2-3 days में distribute होना, पैसा आना 2-3 days में distribute होना, then I will be safer. If money comes and sits with me, who will pay to the depositors? That amount they will charge it. If it is 1 crore, 2 crore, small money, they will ignore it. Understood? So now tell me, prepayment charges, is it a borrowing cost? Question mark. The minute you say borrowing cost, it may be capitalized if it is pertaining to that. And again, in the practical scenario, you know, what will happen? I have taken a SBI loan. I have taken it for 9% fixed rate or something. Correct? Right? Tell me, now SBI loan ka, now I wanted to shift to HDFC. Why? Means these guys are, loan is still there. I will shift. You know, na? Have you heard or not? Correct. Now you can transfer the loan from one bank to another bank, right? So first I have to repay this bank. Because these guys are offering for 8%. I thought I'll save 1% for the balance period is not a small number. So I'll make some 50,000, 1 lakh, 10 lakh rupee, whatever it is, some prepayment charges I'll make. So should I consider this as a borrowing cost? No, not a borrowing cost. Remember this. Prepayment charges are not borrowing cost. It is not to borrow, it is not, it is just a shift of loan. It is to clear the loan basically. It is not to get the loan. Cost related to getting the loan is a borrowing cost, not to clearing a loan. Okay, right. And one more beautiful thing, they have asked or doubt, they must have not asked so far. 1 second. This is a normal question. This not asked. Okay, but I'll tell you. Yeah, this is, I mean, potentiality is there to ask. That much I can tell. Okay. This is holding company. Okay. We have taken SBI loan at the rate of 10%. Okay, how much money? Say 100 CR. And there is a subsidiary company. Correct? Na? E-loan is shifted to 100 crore rupees. They will give a loan to subsidiary company. They will say 0% also they will tell. Holding and subsidiary, na? Anything will work. Okay. So 0% डाल देंगे. Now R. Okay. See 0% को 6% कर देंगे मैं. Correct? 6%. So 6% say what you must have done? You must have capitalized at the rate of 6%. Do you agree with me? Capitalize the rate of 6% because you are in the books of S. Subsidiary books में 6% that is the real cost. So you must have done EIR, effective interest rate and etc. You must have applied. Correct na? Agree? Actually 6% okay. Still fair market value or arm length price and everything, that is different circumstance. I'll tell you. I'm not going that deep. Okay, right. But when you look at the consolidated financial statements, if I see, what should I do? In case of consolidated financial statement, is the 6% whatever I have capitalized will continue? What should I do at CFS level? Ind AS में consolidation is not so straight consolidation. Seriously, not so straight consolidation. You have to be aware of all the transactions between the parent and subsidiary and group entities, then should jump in. Otherwise, you will not do a good financials. If you don't show, nobody can catch also. That's a different thing. But if you want to be fair and perfect, no, you have to dig lot. Question clear? Huh? What are you supposed to do? You should reverse this 6%. You have to do it at 10%. Recalculate करना. समझ में आ रहा है? Because as a group company, it is funded by what rate? SBI loan. Correct na? SBI maybe general borrowing rate. Agree, general borrowing rate only you get it there, but not. You understood? This is intercompany ka borrowing. This is for your purpose. Standalone level it work, but not at consolidation level. Consolidation level में 6% को reverse करो and do calculate at the rate of 10%. Understood? One more practical scenario I'll tell you. We have few minutes after 1 minute time. That's why I'm doing. Otherwise I would have not done. Okay. Suppose I have a loan. These are all okay. These are all not explained in the book and all. That is a problem. But these are all the things which will happen. Life may it happens. Nowadays too much happening. Because everybody get into market, udhar correct na? That is more problematic. It's okay, we need to know. Loan is there, correct na? I may be having a fixed rate of interest. You must have heard swap. Huh? What is it? What is the full name? I mean, swapping, eh? Any other word? One word is there, yeah. Suddenly, fine. Right. Swapping in the sense you know that at least you got the idea. I mean, fixed rate of interest will go to the other party, variable rate of interest it will go. Correct, na? Right. And okay. The example, my interest in rupees may if I put 10 lakh rupees is the interest cost. Correct? Because of this loan swapping, whatever it may lead to a gain or it may lead to a loss, depending upon the circumstance. Correct ना? Assume there is a gain only. Gain है तो this is expenditure positive में रखा तो gain तो minus में रख रहा है. Okay ना? Nothing wrong. So should I capitalize 9 lakh का 10 lakh का? Question clear? Shall I repeat the question once again? Loan related interest cost is 10 lakh. But what did I do actually? I have taken a loan from SBI. But loan swifting can happen. Swifting is not physically, nothing will happen. My loan, me only will be there. Right. What is other word I am not getting exactly? Hedging is overall word. Fine, not a problem. I have fixed rate of interest, you have variable rate of interest. Correct, floating rate of interest. Right, can we shift our interest variability? Interest can be correct. Now you will be handling the fixed rate, I will be handling the variable rate. And isn't it a derivative? And because of this derivative, I will be having a gain or loss at the balance sheet date, which is again FVTPL as per 109. Forget about that side of concept. Come to this side of concept. I won, I got a gain. As of today, I got a gain. Hello, understood? How much is your gain value? 1 lakh. Now, question, what should I capitalize? Is it like 10 lakh should I capitalize? 10 lakh minus 1 lakh, 9 lakh should I capitalize? The question is, you may practically, you may not get the doubt only first. You understood? If someone raises that question, then you will start thinking. Practically, that's the problem. Practically, normal ho raha hai. Correct, na? Charging to P&L, that's all. Unless until somebody thinks in the different angle and say, why are you capitalizing? Isn't it my exactly actual loan cost is equal to 9 lakh and can't I do it? Correct, na? Yeah, again, this goes by accounting policy choice, or management can say, this is purely to hedge off this loan. No. This is purely to hedge the loan. Correct, na? Then you can say 9 lakh only my cost. Or they can say, no, this I am treating it as FVTPL. The derivative is treated as FVTPL. I am playing with the loan, but not for hedging purpose. I am just playing with the loan, I am making money. Then transfer to P&L. Got it? Again, here it will go by. That's where when you get into a multi-country, I mean, what do you say? Global companies basically, then so many derivatives, so many games will be there. First, you need to understand and you need to get the relevant question. Then you need to break your head to get the correct answer. Then accounting. Okay. But the ball game of this interest at consolidation level will be very great. Okay. It may happen ki, correct na? It may happen ki, what will happen na? In consolidation may I'll tell. This situation ka, we can complicate it. How we can complicate, I'll tell you. E company, H company hai, aisa correct na? H company must have taken 10% loan from SBI, correct. And there may be subsidiary number 2 may be there. Subsidiary number also must have taken a loan. Correct na? But when I calculate my balance sheet, group is group, not just only parent. Correct na? Under that circumstance, what will happen, my dear? I will get SBI loan. Suppose this is HDFC loan karke bolo. Then HDFC loan will come. E number. You have to consider both the things for general borrowing. Not that only parent wala. I understood, because consolidation when I am preparing, all the company liabilities will come. Na? That time general borrowing has to be recomputed. R8 should be capitalized, not what your subsidiary one has done it. Hello, understood? This is the way it will happen at consolidation level. That's where it is challenging, very highly challenging. You need to be alert, very alert. Correct? It's not like somebody, whenever there is a capitalization in the company, you need to think twice. Correct? Na? General borrowing, specific borrowing, what is the group level borrowing? Then it's not a simple straight line. Correct? E cost, R cost, add, E loan, H loan, add and put it there. No, no, no. That may be bookish. Okay? Practically, it won't happen. Fine, my dear? Right. So, as planned, let's get into account Ind AS 16. Okay. We'll do Ind AS 16 plus 38, that is intangible assets, plus 40. Okay. Together it will happen. So that, I mean, yes, there are some differences, obviously, not everything exactly same. Right. But we can read it together. Fine. Yeah. Let's try. So, Ind AS 16, as you know, it is a property, plant and equipment. At one time, there was some 12 marks or 14 marks question. Scrubbing, I mean, Ind AS 16 plus 38, 38 I doubt, but 40 he has included. 16 plus 40 included and kept one big question for 12 to 14 marks he asked earlier. Okay, right. I mean, the clarity with respect to 16 and with respect to 40, he tested with different ways. Like say class wise, you can do the revaluation model. Yes, again, especially with respect to revaluation model. And investment property revaluation model is not allowed. Only cost model is allowed. Correct. No? Those points he again and again checked, tested basically. Okay. Right. So 38 is nothing but intangible asset. This is nothing but investment property. Okay. Right. So what is PPE? PPE related, some more questions have come in the past. What is that? It is related to like, can we capitalize the property, plant and equipment or not? Okay, right. So when do you say it's a property, plant and equipment? First, property, plant and equipment, when can we recognize it? When can we recognize it? When can we recognize? Simple thing. First you should satisfy PPE definition. Correct na? First you should satisfy what? PPE definition you should satisfy. Correct na? Plus two conditions of asset. Yeah, two conditions of asset. What are the two conditions of asset? Probable future economic benefits inflow plus cost or value can be measured reliably. Okay. Same way, intangible assets also. Yes, intangible asset definition you are supposed to satisfy. Okay, it should be intangible and plus same in the sense that the same two conditions of right. What is property, plant and equipment? Property, plant and equipment, what does it say? The definition, that is a tangible asset. Correct na? Right, which may be held for producing goods, correct na, or providing services, or for rentals, or for administration purpose. Plus the life, useful life, correct na, useful life should be more than 12 months, more than 12 months. Then we will say it is a property, plant and equipment. It should be tangible, right? It is held for more than 12 months. Useful life is for more than 12 months and held for producing goods or providing services and etc. With respect to intangible asset, what is intangible asset? Intangible asset is an identifiable non-monetary asset. Identifiable non-monetary asset. Yes, without physical substance. Non-monetary asset without physical substance. Yeah, identifiable non-monetary asset without physical substance is what? Intangible asset. Here also, correct, identifiability. Yeah, but they are not going that deep in the so far examination. Identifiability means simply separability. Separability means what? Separately you will be able to sell it. Separately you will be able to rent it. Separately you will be able to, what do you say? You will be able to use it. Anything you can do it. I mean, if I say I have a brand, can I sell it? Yeah, you can sell it without selling the entire company as a whole. Correct na? Right. Separately in the sense without considering, without the business. Yeah, without the entire business, I will be able to sell only that intangible asset. I have a software. Can I sell only software? Yeah, I can sell. I have software I can sell it. It doesn't mean that I have to sell entire company. Correct. Now, if I want to sell goodwill, can I sell only goodwill? Only goodwill can I sell? Can I buy in Reliance company? Only Reliance company goodwill I want. I don't want company. It won't come. It will come along with the company. Got it? Like that. So brands, copyrights, all these licenses, whatever intangible assets, intellectual properties, know-hows, all these things can be sold separately. Okay. Plus, next, if it is arising from yeah, it is arising from the contracts. If it is arising from the contracts, okay, then separability is not required. If it is arising from the contract, then separability is not required. Example, the best case which is given in the standard itself, arising from the contract. Example, nuclear power plant. What is the example? Nuclear power plant. Government say you got a license. Got it? Right. So for that, to get the license, you paid, say example, some 100 crore rupees you paid. Right. In the agreement, it is very clearly mentioned. Yeah, you paid for the license this much, but you cannot sell this only power plant license. I cannot give it to somebody. If you are selling with the permission of the government, power plant plus power plant license, everything together you are supposed to sell it. Correctly speaking, separability is not there. Agree or not? But this arises, whatever is arising, is that it's arising because of the contract between the government and you. Yes. So when something is arising, because of the contract, then you don't need to look at separability. Separately, will I be able to sell or not? Correct. Are you getting my point? Something purchased, brand I purchased. This is not a contract. Okay. This is like license, continuity is there. There you will say contractual, any arrangement, then separability is not required. Other than contractual liability, then separability is required. Okay. Say example, I purchased copyrights. It's a bought. Okay, right. Will I be able to sell only copyright? Yes, you will be able to sell. Most of the things you will be able to sell. Yes, few things you will not be able to sell. Then that cannot be an intangible asset in the balance sheet. It cannot be an intangible asset in the balance sheet. Next, what about investment property? Investment property is what, my dear? It is a land or building, correct? Na? Or part, got it? Or both, right? So it may be land, it is both, land, building, or both, or part of building, part of land, whatever it is. But it is held for what? That is the important thing. Held for what? Held for rentals. Held for rentals or capital appreciation and capital appreciation. Yes, held for capital appreciation. It may be rental and capital appreciation, rental or capital appreciation. Okay, then it is going to be investment property. Clear? Right. Next, if I see this initial recognition, sir, initial recognition means what? Day one when you are recognizing it. First time when you purchase. Yes, first time when you buy. How do you record it? It will be recorded at cost. This also will be recorded at cost. This also will be recorded at cost. Investment property also, all the things. Initially, everything will be recorded at cost. Cost means all the expenses directly attributable to acquire. क्या बोला? All the expenses directly attributable. The question is correct now. The point here you need to focus. Generally, students do take very light this point. All expense directly attributable. Okay, directly attributable. Directly attributable to bring the asset. To bring the asset. Asset in the sense that may be PP, that may be intangible, that may be IP in my case. All the three. Okay, to the working condition. To working condition. Till it comes to working condition, whatever directly attributable expenditure, the important word to catch is directly attributable. What do you mean by directly attributable, my dear? Any idea? What do you mean by directly attributable? Anything else? Only what do you mean by directly attributable? Simple. You remove this side, that side. You tell what is that meaning. Without that expense, you will not be. I mean, this expenditure is incurred directly related to the asset. Is one way of telling. Correct, na? Yeah, I can tell two ways. Okay. Yeah. Expense incurred. Expense incurred only for this asset. Correct, na? Yeah. It is incurred. That is one way. Fine. Another way of telling, if I had not, correct me, if I have not bought this asset, I would have not incurred. E line is more important, more crucial. Okay. If we have not, thank you, man. If we have not bought, if we have not bought the asset, we would have not, we would have not incurred. Yeah, this is more straight and simple. What is that? I spent something. Why you spent? The asset is there, I spent. The asset is not there, I would have not spent. Suppose brokerage you paid. Why you paid? Because I bought the asset. If I had not bought the asset, why will I pay? He is not my relative. Correct, na? Anything. Right? Site preparation cost. Yeah, you made one platform for fixing one big, some 10 tons of machine. Correct, na? Big machines will be there. You can't keep it on the floor just like that. Correct, na? If you keep it on the floor and switch on, it will be shaking. That shake means the entire build will be shaking. Building will be shaking, obviously. So life of building also will come, fall down. Right? So what do you do? That's why we'll dig and one basement, like what do you say, like pillar, how do you do? Metro pillar also, how do you do? They'll start from the dig from the down and they'll make a proper base, then the pillar will come out later. Something like this, you will be making one proper base, on that you will fix with screws and all, you will fix it, then it will not shake. Site preparation cost, everything. Okay, why have you incurred this? Because the asset is there. If asset is not there, I would have not incurred. Any professional charges for installation? Yeah, asset bought, that's why I have spent. If asset only not bought, why will I pay to this man? Hope you understand. That will clarify a number of questions of yours. It is directly attributable or not. That is very crucial. Okay, right. So these sentence is applicable to all three. It is not only for PPE or intangible asset or not for investment property, because anyhow all are at cost. Cost means all the expenses incurred till the date. Hope it's clear, right? So that is initial recognition. Initial recognition, that is at cost. Next, sir, if it is a barter system, they never asked so far a question on barter system. Frankly speaking, they have never asked a question on barter system. I can say this. Whatever I explain, na. Correct. Okay, very good question. So what is he saying? PPE may, yeah, his question is like if PPM also it is held for rental karke it will tell. And in the investment property also it will tell it is held for rentals or capital appreciation, it will tell. What is this? Correct, na? PP also, building also PP only, no? Right. The point is, when there is a specific standard, when there is a specific standard, this IP is applicable for what? IP is applicable for land or building or land and building, correct, na? Or both. If there is a specific standard for land and building rental purpose, okay, then you are not supposed to read for land and building. If you have rented out, PPE should not be read. So there a specific, that's why what the standard says, na, Ind AS 16 says, if there is any standard deals with any PPE, then first go to that standard, don't come to me. It is scoping out. It is scoping out means if you have a specific standard, yes, we have a specific standard for land and building rented out. Are you getting my point? Then one should refer 40 but not 16. Clear? Right. So it should not come to 16. You should have to go to only 40. In the sense, to read it together, you can say other than land and building. Suppose one machine is there, I rented out. Then come to 16. Correct. Actually, not even 16. First, you should go to 116 because you rented out. That may amounts to lease. Correct, na? So then if the asset continues in the balance sheet, then we'll speak. So Renting of 100% only 40. If Mantri Mall is there, example, Prestige is there, so many big. Here no production, it is meant for rental. That's why I told, if you have land and building which is meant for rentals, standard 16 says don't come to me, go to first 40. Even though your main primary business itself is doing rentals, still you are supposed to follow 40 but not 16. Okay, that's why if you, I mean, not now, maybe after exam or sometime, you can look at the like monthly to now out. Okay, Prestige, so many are there now, so many big builders who have got the big bank, I mean, what do you call, property. Their main business is what? Renting it out, correct na? Right. Look at their financial statements once, right? It is only 40, it has to be only 40. Okay, they cannot go to 16 just because rental is there, correct na? So I mean, other than the land building rental, if any other renting, okay, then come to my standard 16 ko you should come, not to 40, because 40 is specific to only land and building. Clear? Right. Chalo. So that is one point. Where were we? Barter, I was talking, correct na? Yeah. In case of barter, my dear, in case of barter, I can say it is same accounting, whatever I am telling na, it is same for all the three. Okay, something you bought it in barter system. Excellent. What is there? First, there are two conditions, my dear. There are two conditions. Okay, two conditions. If you satisfy both the conditions, our accounting style will be fair value model. If you do not satisfy the condition, it will be book value model. Okay, right. What are the two conditions? First, there should be commercial substance exist. Commercial substance exist. Yeah, commercial substance. What is commercial substance? Don't need to do research and development on this. Simple word, what I will say, items are different. Okay, different items, not same, different. Yeah, commercial substance exist means items are different items, that's all. Okay, right. It may be machine only. Yeah? Sir, both are cars. Arre, bas, mine is Maruti car, yours is Mercedes. Both are same. Just because car is there. So if they say machine, those are machine same. Don't tell me. We don't know what it is. Unless until he says in the question there is no commercial substance exist, then only you should think that way. Otherwise, always your thinking should be items are different. Getting my point? Plus second point, that is the fair market value of either given asset or taken. Can be measured reliably. Can be measured reliably. Yeah, either given asset or taken asset, you will be able to measure it reliably. Getting my point? Right. Have you satisfied both the conditions? Yes, satisfied both the conditions. Or no, any one condition also not satisfied. If it is satisfied, then you will be going the fair value model. Model in the sense not, okay, some simple our name this is. Okay. The next one is book value model, we will be doing it. Item should be different. Any one of the item ka fair market value I should be knowing. If I don't know fair value, then how do I come to fair value model? Yeah, correct na? Right. So automatically you will not be coming to fair value model. Right. Then you have to go by book value model. If you come to fair value model, no, the asset received. First, the asset received. The asset received? Why I say asset? That may be tangible asset, intangible asset. That may be investment property. All the things are same concept I told. The asset received should be measured. The asset received should be measured. Measured at what, sir? Measured at the fair market value of asset given. First priority will go to asset given. Okay, right. This is the first priority if you have both information. Or fair market value of asset received. Yes, asset received. Yes, this is second priority will do. The asset what I record should be at the fair value of what I gave, first priority. What I am getting should be recording at the fair value of the correct asset given. Agree? Plus or if it is not available, then I look for the next one. Right. There may be any gain or loss. There may be any gain or loss in this, that should go to profit and loss statement. It will go automatically. it can go to profit and loss. Okay, say example, simple example. Okay, like say there is a land. Okay, the book value is equal to 1000. Okay, the fair market value of this, yes, fair market value of this is equal to 1600. What are we getting? Sir, we are getting car. Something example I am telling. Okay, car fair market value. Car fair market value maybe some X number, I will keep it because I have given the fair market value of this. What I gave, that is more than sufficient. Agree? Right. So what should I record now? What should I record? Car is coming, car account debit. So land is gone, land account credit. Correct na? Land credited by what number? Land cost nahi, book value. Whatever land is gone, so land should be removed from the books of account. So what is there in the book if I write, that will be out. Correct na? So 1000 rupees I will record. But the standard says about one, not what you throwed out. Correct now? What is received should be recorded at fair market value of the asset given. What you risk? Car value should be what? Fair market value of the land. Agree? Yeah. So that means this is 1600. So that difference will go to, correct, P100 ko it will go. Or suppose in case if you gave cash, further cash, okay, to cash I will write balancing figure will be the profit. Cash also you gave 100 rupees. Fine, 500 rupees will be my, I hope you understand. Right. That's all. That is very simple way. Fine. Can I go ahead? Right. If suppose if you have not satisfied the conditions, you not satisfied, what is that? You don't know fair value first. Correct. Now you don't know fair value. Then where is the question of fair value of this? Correct. Na? Right. So here book value model mein what do you say? The asset received, yeah, the asset received should be measured. It should be measured. Yes, it should be measured at the book value of asset given. That's all. What is the book value of the asset given? That value only you will be recording it. Right. Plus or minus any cash. Any cash. Any cash. Cash means that may be either given cash or you have received the cash. Right. Here there is no chance of profit or loss. No chance of profit or loss. Why means value only you don't know. And the things are happening at book value, how the gain or loss can come? So there cannot be any gain or loss. Sir, I got gain or loss. That means you did mistake somewhere. Correct na? Gain or loss cannot happen under the book value model. Is it clear? Right. With respect to, right, this is majorly for the this is broader is for all. Okay. Right. For intangible asset, there is one way, that is self generation. Correct na? What is this? Self generation of intangible asset. Yeah, this is only specifically applicable for intangible asset, not for anything else. Correct? Right. Self-generation. Self-generation, broadly we can say what? Self-generation of goodwill can happen. Self-generation of brand can happen. Self-generation of titles can happen. Correct? Self-generation of customer details. Correct? So I have got so many customers card details. That is also self-you generated. Correct. First, these things cannot recognize, first of all, you cannot recognize the intangible, cannot recognize the intangible asset. First point close. Why? Why means what is the cost you have spent? Correct na? You cannot measure cost. Simple. Why means you cannot measure cost. I can't measure cost. Okay, right. What about the other intangible assets, sir? Other intangible assets. Yes, other intangible assets will be arising in two phases. May it will arise. Correct. So the first one is equal to research phase. The next one is equal to development phase. Agree? Right. So whatever is there in the research phase, that as you know, it will be 100% charged to profit and loss immediately. No deferment, nothing. It has to go to P&L. P&L ko leke jao. 100%. In the current year, I spent for research some X number, charge off. Okay. Till you are done with research. Last day tak whatever the expenditures, the research is successful. Research successful or not successful is secondary. Okay. Research successful, my dear, does not bring you the money immediately. Okay. It does not bring you the money immediately. How? I have a knowledge. Research means after research, what do you get? Knowledge will come. Correct na? This will work like this. Whatever, everything will work, no. Business में पैसा नहीं आता. Everything may work. See, in COVID case, COVID situation में, COVID vaccine is that only Bharat, what is that company pair? Hyderabad wala. Covishield, yeah, they prepared Covishield and next Covaxin. Covishield is not this one. Covishield is Pune wala. Correct, na? Covaxin is from the company name starts with Bharat. Okay, yeah, fine. That is a Hyderabad based company. This is right. Do you think only these two people have done? No, no, already 3-4 companies have done already. But you know, none of their products got sold. Okay, right. None of Jaidus karke, JYDUS something. Jaidus karke, there is one more company. Jaidus Life Sciences company karke is there. They also produced, they also got something. They sold only 1 crore vaccines to government of India. Subsequently, they could not sell. Is it good item? Good item hai. Worked only. But that's what I'm telling. That just knowledge has come does not mean that money will be received. Money will come karke. Correct. It may not be successful, may be successful, may not be successful. There are so many problems are there. That's why whatever the amount you spent till the last date of research should be charged to profit and loss statement. Okay. Development. With respect to development expenditure, you know, right, can we capitalize? Yes, you can capitalize it. Yeah, you can capitalize it, but this you can capitalize it, you know, subject to, yes, subject to 6 conditions. Yeah, subject to 6 conditions. This is first and foremost important thing. You can capitalize it, nobody will stop you, but subject to 6 conditions. Okay, these 6 conditions you are supposed to demonstrate. Yes, demonstrate every year. Demonstrate every year till completion. Okay, till the completion of the development, you are supposed to demonstrate every year. Demonstrate. You have to test yourself. Okay, 6 condition. 6 condition mein, my dear, which you need to focus mandatorily, you know. The 6 condition may, that is a technical feasibility. Okay, technical feasibility. Yes. Is there a technical feasibility to be surviving? Will it happen? Technical feasibility is there. Means, feasibility means, does it work out? Technically, does it work out? Till the time, whatever you spent, till you get the technical feasibility, everything should be charged off. Remember this, right? Remember this, all expenses till technical feasibility, right? Charge off, right? Okay, this is very important. Remember the word technical feasibility. He'll play with this in general. Okay, till the date of technical feasibility confirmation, yes, it works out. We can go ahead in the market, right? They will be doing the analysis accordingly, only it should go. Fine. Yes, so technical feasibility is first foremost important. Rest other 6 conditions are there, like will I be able to sell it, can I make a product and sell it, can I sell the item, I mean knowledge I will be able to sell it, can I measure the cost, correct? Do you have intention to complete it, do you have technical resources and human resources, monetary resources, do you have to complete this, correct? There are 6 conditions are there. You don't need to remember 100% of it, that's why I just told orally. Okay, right. For the point is here in this standard, this is specific to only this standard. Once you charge off the demonstration, suppose that in any 1 year you are not able to demonstrate the 6 conditions. Example, not able to, yes, not able to demonstrate. Not able to demonstrate. What are you supposed to do? 100% charge off. That's all. Till the date, whatever you have incurred. Anyway, suppose your development will not continue with just for a year or 6 months. Development of some products will be continuing for years together. In year 2, you could not satisfy the conditions, you could not demonstrate yourself that it is going to fetch me future economic benefits. Then whatever you have spent so far should be charged off to profit and loss without any thinking. Understood? Next, once a charge off, okay, once a charge off, you cannot reverse. This point is very, very crucial. Once you charge it off, you cannot reverse it. I hope you understood. First year you spent 100, next year you spent 100, both 100 200 you charged off. Okay, next year you spent another 100, only 100 will be, next third year you are able to satisfy the conditions, only 100 will be there in the balance sheet. Whatever is already charged in the second year, na 200 wala pura, once it is gone to P&L, is gone forever. That is applicable for IA, intangible asset. Okay, when demonstration expenditure ka, that is specifically it is applicable, specifically it is applicable. Clear? Done. Right. Next, intangible asset again. Intangible asset ka, if it is acquired as part of business combination, let's see that in 103 straight away, because there I will explain it in detail. Okay, IA acquired as part of business combination. Yes, business combination mein, otherwise let me close it here. What is there? Yes, IA is acquired as part of business combination. Yes, you have to measure it at, you have to measure at fair market value. Yes, you have to measure it at fair market value. Mein you have to measure it, because all the assets and liabilities, whatever you bring it in the business combination under 103, correct now? Business combination is Ind AS 103, right? Should be measured at fair market value. Got it? But again, it should be identifiable. It should be separate, identifiable, intangible asset hai to nahi, then you will take it into balance sheet. I hope you understand. If it is, there is no identifiability, then it is not, it is going to be the excess amount whatever you paid will become goodwill, but it will not be intangible asset. Hope you understand. Correct. Next, the question is, you have acquired as part of business combination. Okay, it will be recorded at fair market value. Right. One more thing, you have acquired as part of BC only. Okay, as part of BC. What is that you have acquired? Not intangible asset. You have acquired research. You have acquired. What did I say? Research only you have acquired. Research phase of some other company. Some other company is doing research. They have done the research for 2 years. Is it research completed? No, not completed. Okay. I am buying from you. Is there any asset in your balance sheet? No, not there, because you will follow Ind AS 36, sorry 38. Correct now. You will charge off all research expenditure, but I like the research. It must have come to some advanced stage, maybe not yet completed. Okay. I thought I'll buy the research also. Then what do you do, sir? I'll continue the research from now, and I'll go to development phase, etc. later. Are you getting my point? Hope you understood. Now, I paid something. You obviously incurred for research, na? Which you charged off, or whatever it is, you incurred. Agree or not? Why will you give freely to me? So, I paid some good money to you. Some 100 CR I gave it to buy the research. Understood? Now, how should I recognize? In my books of account. Fair value, they will say, what is fair value for research? Research cannot be, fair value cannot be comparable. No. All researches are unique. Agree or not? No research will be matching with another research. Right. Whatever you pay, that itself is a fair value, that itself is a cost. You recognize it at cost. But subsequently, if you spend money for the research, you continue the research, Subsequently, if you spend money for the research, that should be charged off. If it is a development, you capitalize it. Are you getting my point? If you are continuing the research phase, or research phase expenditure, you should charge it off. Development phase, you can capitalize as usual. Have you understood? Again, this is not necessarily should be part of business combination again. Sir, no business combination, only I am buying the research phase matra. Just research phase I am buying. I am not buying the business of any company. Still, same accounting holds good. Getting my point? Right, what do you say? As part of business combination or not part of business combination? not part of BC. BC means business combination here. What are you supposed to do? Yes, you can capitalize it. You should capitalize it at, I will say, fair market value. That is nothing but cost. Fair market value is nothing but cost here. Okay, but and subsequently, right? Subsequently incurred. Right. Subsequently incurred. What you incurred? Research expense. If it is research expenditure, it will be charged to P&L. If it is development expenditure, yes, can capitalize. You can capitalize always 6 conditions, subject to 6 conditions. That sentence will automatically follow. Got it? Yeah. If yes, please. Brands are identifiable. Yes, it is taken at brands. If taken, brands are bought as part of business or combination, yes, it will be recognized at fair market value. When I'm acquiring your company must be having brands, obviously. It may not be there in your company financial statements, but I will get the valuation done. I will record it at fair market value. Okay, I will get it recorded in my books. I will record. When I am recording, I don't need to see your books, whether you have recorded or not recorded. It is irrelevant to me. Okay, if I don't record that, actually, then all amount will be part and parcel of goodwill. But it is not exactly. It is a brand. Brand can be, suppose tomorrow I can sell only one brand to somebody else. Correct? No? I can sell. Only brands can be sold without entire business also. So it is identifiable, 100% identifiable. Okay. When I was with USL, United Spirits Limited, I mean PwC auditing time, they bought so many brands from different companies. Whatever the liquor brands what they are selling right now is everything is not developed by them. Their brands were limited. The other names were, earlier it was manufactured by some other liquor companies, but these guys have taken over. Means from now onwards, that item, the other company, whoever is selling, no, they will not manufacture. Only these guys will manufacture. It's like that. Brand is identifiable, saleable separately, an intangible asset that should be recognized. Okay, na? Right. So this is a small part of self generation of intangible asset. Correct na? Here, sir, if it is a self generation, what all you will capitalize it? What all you will capitalize means? What is the cost you will capitalize? What are the cost, my dear? There is obviously salaries. Correct na? Salaries of the experts will be there. Right? Overheads will be there. Correct na? Material will be there. Yes, material and many things will be there. Correct. Now, if somebody is doing development or research means he will be getting the software, he will be having computers, depreciation, agree or not, rentals. Correct. Now, the power will be there, maintenance will be there, security will be there, what not, yeah, repair cost will be there. All the expenditure related to development is supposed to be capitalized. All the expenses that is related to should be capitalized. And again, listen, this is applicable for all four. Next, what should not be part of? Should not be cost. Which should not be a cost. One, general administration expenditure. Never be. Okay. Then next, abnormal loss. Yes, abnormal loss. No, it is not supposed to be. Okay, abnormal loss when you are doing the research or development, or when you are under the construction, if there is a one wall fell down, or wrongly they got constructed. Correct. Now they got somebody, yes, plan is wrong, some wrong is there, that is a loss to me. I cannot capitalize it. Okay. Any selling expenses or something in case if they say no. Right. Next, operating losses. Operating losses. Sir, I started business by using this machine. Okay. First year I got a loss. So a loss also I will capitalize asset. How here? Loss should go to P&L. How it will become asset to you? But understood my point? So no. Any opening ceremony expenditure, opening ceremony expenditure, all these advertisement cost and etc. can never be part and parcel of cost. It should be charged to correct na, P and L, whenever it is, correct na, all these things, charge to P and L, charge to P and L when incurred. Whenever it is incurred, you just need to charge it off. Nothing can be capitalized. Nothing can be capitalized. Agree? Right. So the initial recognition wala part is done. Next, again, one more thing. Sir, component accounting is there. Component accounting. Component accounting means, you know, right? Each significant asset should be recognized separately. Okay. Each significant asset should be recognized separately. It may be part of one asset, but account for part A account debit, part B account debit of one asset. You should do like that. Is it applicable? Yes. For the intangible, for the PPE applicable. For PPE applicable. Is it applicable for this? No. For 38, there is no component accounting. Obviously, for intangible assets, components cannot be there. Right. For the IP, that is 40. Is it applicable? Yes, applicable. Okay, it is applicable. Next, sir, deferred credit concept. Yeah, what is deferred credit concept? You are paying more than after, correct na? Right. Payment is what, greater than 1 year. When are you going to? You bought today. When will you pay? After 1 year, I will pay. Correct. That means what? Interest element is there. Agree or not? Right. So that's why what are you supposed to do? You have to record at cash price. Cash price. Or if they have not given cash price, then present value. You bring it to present, discount karo, present value you are supposed to follow. Correct. No? Difference amount will be considered as interest expenditure, finance cost. Correct. Right. Yes. Is it applicable? Yes, it is same. Here also it is there. Here also it is there. All the three cases, deferred credit period. If you have purchased something on deferred credit terms, then record it at cash price, not at agreed, whatever the amount, invoice price. Correct. Right. And the whatever the cash price and the actual amount what you are going to pay over a period, that should be considered as interest, finance cost, that should be charged to P&L, cannot be part of PPE. Okay. Right. Then, sir, subsequent measurement. Yes, subsequent measurement. Subsequent measurement. Subsequent measurement may, I will say part 1, not on the balance sheet date. Any expense incurred on the already recognized asset. You got my point? What did I say? Any expense, suppose this building is there, 3 floors it is there. Now you are constructing 4th floor on the same building. You are spending on the same asset for further development. Are you getting my point? So now what should I do? Right. What do I write here? Any expense incurred on already capitalized asset. An already capitalized asset. Okay. Rule is same, my dear, with respect to all, same rule. Okay, this is same rule. I will tell that what it is, I will tell. Okay, right. Yeah, so same rule here. Yeah, what is the rules are here? Simple, ma. Same conditions. First, initially, the two conditions we discussed. Na? One is PP definition, next is asset 2 conditions. If you satisfy, are you getting my point? Then you capitalize it. Otherwise, you should charge it off. E rule is there for intangible asset also, tangible asset also, and investment property also. Same rule, 100% same rule. That's why it's better to do 3 things together instead of wasting time otherwise. I hope you understood. Right. What are the 2 conditions, my dear? It should satisfy the definition. Satisfy the definition plus 2 conditions of asset. Plus 2 conditions of asset. Yes. If you say yes, then capitalize it. Yeah, if you say no, then charge off. Okay, if you say yes, capitalize it, otherwise charge off. Okay, rule is same, no change in rule first of all. Next, on the balance sheet date, part number 2, on the balance sheet date. On the balance sheet date. On the balance sheet date, yes, there are two models are available to you. Okay, there are two models are available, right? Here also two models are available, intangible assets related. This is only one model, that is cost model. Cost model. But however, correct na? However, you have to disclose. What you are supposed to disclose? Disclose fair market value of investment property. Disclosure of the fair market value you are supposed to do it. That is the worst part. Okay, disclosure is required for the this one. Which are all the two models? That is, as you know, cost model. Next one is revaluation model. Yeah, this is also same. Yeah, models are same, but there is a small problem point is there with respect to intangible asset. It is little different. Whenever I say cost model, what do? You will be measuring at, correct? You will be measuring at, what you will measure at? You will be measuring at cost minus accumulated depreciation minus accumulated impairment loss. Okay, impairment loss. This is what you will be putting. This is the carrying amount. This is the carrying amount. Okay, impairment loss, what you, that is the carrying amount of the asset. If you go by the revaluation model, for this is, as you know, this is for the PPE, this is for the intangible asset, this is for the investment property. Correct. Yeah, revaluation model, that you need to measure at fair market value. You need to measure it at fair market value. Yeah, bring the fair market value to the books of account. Okay, na? Right. But is it every year? Is it every year? Not required. No, not every year. You don't need to measure it at fair market value. Standard itself says 3 to 5 years once. 3 to 5 years once, if you do it, sufficient. Okay, 3 to 5 years once, sufficient. Right. As you know, if there is any gain, that is revaluation reserve. Revaluation reserve will be routed through OCI. If there is a gain, revaluation reserve, correct na, routed through OCI. If there is a loss, correct, the loss, what will happen? You will hit the P and L, correct. Or if already revaluation reserve exists, what is existing? If already revaluation reserve exists, so debit revaluation reserve, debit to the extent available. Correct na? Right. Then balance amount P and L will be balancing figure. Correct. That will be the land or asset, something. If revaluation reserve exists, utilize the revaluation reserve. Okay, right. Any change, I mean revaluation reserve touch kiya to, if you are doing the revaluation reserve touch, that difference should be transferred to, you should present it in the OCI. E sentence has to be there. By chance, if they ask on revaluation reserve, you have to use the word OCI. It has to be routed through OCI. If you don't write also, I am telling you, some half mark will be, reduction will be there for sure. Got it? Just simply revaluation reserve, if you tell, you may be eligible for 2.5 marks, assume, right? Half mark may be there for OCI word. Got it? So carefully that you need to remember and you need to follow the same. Understood? Right. So that is about the revaluation model. One more point, revaluation model, it is only class wise, only class wise, entire class ko you are supposed to apply. If I say land, correct na, all lands you are supposed to follow. Okay, land ko I want to follow revaluation model, building ko I want to follow cost model. Yes, no problem, you can follow. You getting my point, right? For land, revaluation model I want to follow. Yes, follow. For building, sir, on this land only building is constructed. Yes, let it be constructed, not a problem. Land is land, building is building. Okay, for building I want to follow cost model. Yes, welcome. But for all the buildings, you have to follow same rule. Okay, you cannot do this. I hope you understood, right? Sir, do you have a revaluation model with respect to this also? Yeah, revaluation model is available. Yes, available. But here subject to that is the problem. Okay, what is the problem here? I'll tell you. Yeah, see, I will say revaluation model, my dear. I will tell it should be at fair market value. Same revaluation model is revaluation model. But how do you measure the fair value? Most of the intangibles are unique, my dear. Agree or not? If you say branch I have, unique. Your license is unique. Correct, na? Except something I bought a Microsoft Office. That is normal. I hope you understand. Market mein rate will be available. My software will not be matching with your software. Are you getting my point? If you say Puma brand, sir, Puma brand, there is no one more Puma in the world to compare. You understood my point? Puma is Puma only, Nike is Nike only. These two are different brands. Their valuations, you cannot compare it. So generally, for any fair market valuation determination, comparability is required. Got my point? A comparability you will not be able to get. That's why what the standard says, even though revaluation model is allowed, correct na, it is allowed only when there is an active market. Only when there is active market. Suppose, sir, I am following what is that revaluation model, but some of the assets there is no active market. Then you have to follow cost model for those assets. I hope you understood. You have a bunch of softwares. Some software ko fair value can be determined. Some softwares are internally generated software that is not available in the market to compare with another software. It is not possible to compare. Each one has their own plus or minuses. Correct, na? Right? It is not a physical building or something. Correct, na? What is physical building, sir? This is equal to 30 into 60 sites, sir. Okay. That is 30 into 40 set. Measurement thoda different. Correct, na? Recently, building is sold for one SFT is equal to 21,000 rupees, sir. I am applying the same 21,000 rupees. Correct, na? Something similar nearby item ko I will be able to use, or something I can use it for the purpose. That's what they are saying. Is it actively marketed? Means people are buying, selling in the open market such kind of items. For most of the it's not possible. Okay, so it is just like kind of namesake. Is it there? Yeah, it's there. But it is applicable for the assets which has an active market. If you don't have active market, it is not there. You are end of the day, you will be following what? Cost model you will be following. Correct, na? If not, you have to follow cost model. That's all. You have to follow cost model. If the active market is not there, you have to go by fast model. Anyhow, here intangible, I mean IP, investment property ka only cost model, no fair market value model or revaluation model. Nothing is, both of the things are not applicable to that. Is it clear? Right? Any questions so far? Right. Once one question been asked, this is easy to answer, not very difficult. See, suppose you have a big factory. Okay. Yeah. If you have a factory, my dear, if you have observed any factories, generally there will be one small, very big factory. What will happen? Some small substation will be there here only. Power substation. Have you observed? Big companies ka, big factories ka, what do they do? I mean, I don't know, purpose of maybe power fluctuation reduction, that I don't know. One small substation will be constructed then and there only. Are you getting my point? Right, right. Otherwise, if you say one big apartment is there, what is that? Transformer will be kept there only. One or two transformers separately, you have to get it done for this one. Understand? Here also, the substation is there here. Now the question: the substation is related to whom? Is it my company? Right. Situation what happens? Okay. For the substation construction ke liye, if I say 2 crore rupees it will cost. The 2 crore rupees will be borne by us, borne by the company. We only have to pay. Okay. Right. Whatever the assets they buy, can you use it? You cannot use it. I mean, government people, the electricity board people only will come, they will only use it. It will be in whose name? It will be in the name of government only. It is not in the name of company. Getting my point? Right. So now tell me, can this 2 crore rupees, whatever I have incurred for the substation, where it is not in my name, where my people cannot go and sell off that one tomorrow? Correct now. Sir, my company, I am closing the factory, I will sell all these transformers and all. No, you don't have the permission. They will take it. Hope you understood. Right. Can this 2 crore rupees be a capital, I mean PPE na, or not? That was the one small question was asked. Question clear? Huh? What do you say? It's not a PPE. Okay. You don't have control, but actually the other way around, na, the substation is required mandatorily to have a factory here. If you want to run the factory, substation is must. Without substation, you will not be able to start only. They will not give power also. Got it? So it is, what are you supposed to do? Yes, you don't add it to the factory cost, but it is 2 crore rupees is not a small number. Agree, na? 2 crore rupees is not a small number. That's why what are we supposed to do? Yeah, you do the separate item, correct, component accounting you follow. It is directly attributable to factory. What is the answer? Directly attributable to factory. That's why what should I do? Capitalize ही करना पड़ेगा. Okay, you have to capitalize it. But how do you capitalize? Will you say substation account debit? Don't say substation account debit. Okay, you can write whatever the language you want, or amount given for substation you can write. Some name selection will never bother about it. Okay, right, substation account only you can record it. This expenditure is incurred directly attributable to my factory. If factory is not there, I would have not paid 2 crore rupees to the substation. Are you getting my point? Yes, I agree. A substation is in not my name. Correct, na? Still, it is like that. Okay, next. In case government case, what will happen? No, railway sidings. Have you heard? Railway sidings. Railway sidings means they'll bring a line, separate line. Railway line will come. Okay, suppose what will happen? Mines will be there again here also. Mines will be there. Correct. Now there may be main line is here, train, rail is there, track is there here. So you can speak to the government authority and you only have to pay. Nobody will pay. Correct. Na? So then they will put one separate line for you like this. Train will come. I mean goods train will come till the mine. So then you can use your lorries and etc. So then you can ship the material here. Correct. Na? Then automatically same train will go and go to the destination. Right. E area land has to be bought by government, but whatever the price they will pay, that has to be paid by you. Why will they do it for you freely? Correct. Now, what is the reason? Why should they do it first of all? Obviously, correct. Now, so everything has to be paid by you to lay the track, signal, everything has to be borne by your company. You got my point? Suppose you spent 100 crore rupees you spent. At the same time, tell me, 100 crore you are spending means you are also not a fool, no? You must have done your capital budgeting at least. Correct, na? 100 crore I am spending means if I take my lorries to from the mine place, say if I go to nearby station, how much it will cost? You must have calculated. Maintenance, or headache, everything you must have taken into account. Right. Afterwards, you must have come to a conclusion of this. Agree or not? And it is not a matter of 1 day, 2 days. Na? Mine is there means for 40, 50 years, the same position, same thing will be going on again and again. Daily it will be happening. Now, if the track is in whose name? Government of India, Railways Department. Correct. Now, a land is in whose name? 100% government. Correct. Na? Yeah, there will be suppose some 2 employees are there. Our 2 employee ko salary will be paid by whom? No, we will pay. We will pay to government, government will pay to them. Okay, yeah. We on end of the day our cash because they are dedicated to our line. They are dedicated to our line. They'll take care of everything. Hope you understood. Fine. Their salaries also has to be paid by us. Fine. Salary is a running cost. That's a different thing. But what about all this cost 100 crore rupees? Shall I recognize as an asset or not? Component asset, mandatorily. Correct, na? Not because with mine can be there without the track also. That is there. It is not directly attributable expenditure. But E-track is it even though control in the sense what? If this E-track may other trains will not come. E-track may your train only will come. Is it beneficial to you only or not? Are you able to get the benefit out of it or not? Yes, I told na. Otherwise, why will you? No fool will spend so much of money without doing the capital budgeting. Correct. Now, what is my this way cost, that way cost? Everything they must have calculated. Then they will be doing it. Yes, even though it is not in your name, it should be a property, plant and equipment recognized as a separate railway siding karke total cost you do it. Whatever the salaries you pay, that is a normal expenditure. Every month and month you will charge it to P&L. But whatever the cost you have incurred to lay down the track has to be capitalized. Is this clear? Right. Like that they have asked 1 or 2 times questions on this. Government, but still you cannot stop them. But this is done specifically for you. If their other mine also they have to go in the same route means they will go. If that is if the other mine people also must have paid, then you will be recognizing to the extent you paid the cost. Other party will correct. End of the day, what you paid is only your cost. No? How they use is different. No, you have your mine, my mine is next to it. Right, together correct. Now you paid 40 crores, I paid 30 crores. I will recognize my asset for 30, you will recognize for this. The only thing I am spending because I am going to get the future economic benefits out of it. That's all. Correct. That's why that is my asset. And the future economic benefits won't come in one shot. It will come over a period of 30, 40 years. Agree, na? So yes. So 30, 40 years we will be capitalizing it and charging it off. Depreciation. Shall we go ahead? Right. So these are the first thing with respect to subsequent measurement, revaluation model. This is important concept. Okay, right. Next point what I will say with respect to depreciation. Anything else other than depreciation? Derecognition will spend. Derecognition. Yeah. Otherwise, one second. Don't write it. One question I want to ask you. First, my dear, suppose revaluation you are doing. Correct na? Revaluation ka e point I don't expect a question, but yes, there is a possibility to hai. That's why revaluation accounting. This is given in the standard itself. Okay. Say example, there is a plant and machinery, 1000 rupees. Accumulated depreciation. Okay. Accumulated depreciation, say 400 rupees is there. This is equal to carrying amount. 600 rupees is carrying amount. Agree? Agree. Now, this we are doing the fair market value of it. Let us say this is 1600 rupees today. Market value 1600. Agree? So, what is the entry will record? Yes, the difference is 1000 rupees is revaluation, correct na? Revaluation reserve. What is the journal entry you will pass? Plant and machinery account debit, how much? 1000, okay. To revaluation reserve, how much? 1000. Any other way? Huh? Which one you recognize? No. Huh? Proportionately you can do it, but the simple and best way is whatever the accumulated depreciation is there, first you knock off. That is allowed. What is that you should do first? Accumulated depreciation account debit 400 rupees you make it. Okay, so now E number will become 0. Correct. What you wanted? You wanted this to be 1600 rupees. Agree na? Correct. Now what is there already? 1000. So then you add it to 600 rupees add. Now you should say plant and machinery account debit, that is equal to 600. This is this is the way. Okay. Accumulated depreciation whatever is there, reverse completely. Fine. After reversal, till something is gain is there, then that will be debited to the asset account. Okay, to revaluation reserve routed through OCI. This is the way that should be done. Shall we go ahead? In this case 1600. Cost will be gross value is equal to 1600. Correct. Accumulated depreciation you have to become 0. So 1600 minus 0, net value also will come to 1600 only. Like that. Again, one revaluation, one asset ka revaluation reserve is there. Correct na? Another asset ka loss is there. No, should not link it. E asset revaluation reserve should be separately noted down. E asset revaluation reserve or loss should be separately noted. You cannot mix and match. Asset 1, asset 2, revaluation reserve, loss and all, no. You got my point? One asset may be giving gain, transfer it to revaluation reserve. One asset may be giving loss. This may hit the P&L. Hope you understood. Not adjusted. Balancing figure, net off figure, no, you shouldn't do that way. Each asset, revaluation reserve, loss, everything asset wise, not class wise. Asset wise, separately, you are supposed to do it. Okay, na? Can I go ahead? Right. Next point is, yeah, revaluation accounting. I said derecognition. Now you will go. Derecognition. Derecognition. This is also same, my dear. Same everywhere, same. All the three cases same. Investment property, this and this. 100% same. Okay. Right. Derecognition means what? Removal from the books of account. Removal from books. Yep. Yeah. When do you remove it from the books of account? One is in case of sale, or one is no benefit from the asset. Asset is useless to me. Correct. No? It happens. Asset is useless to me, then also it will happen. Yeah. So no benefit from the asset. Agree. So now what are you supposed to do? First thing, whether you are following cost model, whether you are following revaluation model, irrespective of model, I should say. Irrespective of model. Simple. What is that, sir? I mean, profit or loss on sale is equal to, correct na, sale proceeds minus carrying amount, CA. Okay, sale proceeds minus carrying amount. That you should do it. Understand? Right. And whatever the profit or loss comes, that should go to only profit and loss statement. That should go to only P&L statement, not to anywhere else. Okay. You should not transfer it to revaluation reserve. No. Either profit or loss should go to P&L only. Correct, sir? But if you have revaluation reserve exist in the balance sheet, revaluation reserve something is there sitting in the balance sheet, sir. What should I do? That should be transferred to retained earnings. Transferred to retained earnings. Okay, so revaluation reserve account debit to retained earnings account. Which asset you sold? Asset related revaluation reserve, something must be there. That number you are supposed to transfer it to retained earnings account, not to profit and loss. That's why we said yesterday, what is it? Under OCI, these revaluation reserve will be never be routed through profit and loss statement. It will be only in the SOCIE. Correct? Na? This is part of statement of changes in equity. It will be part of changes in statement of changes in equity. This will be taking place. Okay, right. So that is about the derecognition. One small point, right? So let's go to depreciation. Depreciation or amortization. Depreciation is what? Very simple. Depreciation is allocation of depreciable amount over the useful life of the asset. Simple. It's an allocation, right? Allocation how will it happen? That will happen via the method. Which method I should follow? The method should be what method I should follow? Should be the pattern of consumption. It should be in the ratio of consumption. Basically, what is the method? It should reflect the pattern of consumption. Yeah, in simple words, consumption ratio. Yeah, actually speaking, consumption ratio, not sales ratio. Yeah, but question may, sir, they have not given consumption ratio, only not given, sir. Sales ratio only they have given. Follow sales ratio because assume both are one another same. Understood? Yeah, because sales value, sales value will be going up and down. Say example, I have one machine. It produced 1000 units, 3 years. Correct now? So I have consumed the benefit of the asset equally over the 3 years of life. Agree? But if I say sales, sale value today, current year it may be one item sold for 100. Next year it may be sold for 140 rupees. Next day it may be sold for 80 rupees. That may be depending upon supply, market fluctuation. So many things will be there. Why market fluctuations ratio I should consider for the consumption of my fixed asset sitting in the correct balance sheet? Should not consider. So correctly speaking, consumption ratio is the only ratio that should be followed. But sales ratio, yes, you can follow, right? If question exam purpose, if they give something, please follow, that is fine. Okay. Depreciable amount. What is depreciable amount? That is either cost or revaluation amount, correct? Revalued amount, some number minus residual value. Yes, residual value. A number, if you cut it, that is the depreciable amount. Next, useful life. Useful life is, see, first one I'll tell you. Car life is equal to 10 years a month. Okay, but I bought it to use. I bought it to use for only for 6 years. I want to use. That is my plan. 6 years I will use it. I'll sell it off. I'll buy one more car. Now, what is the useful life I should consider? 10 years or 6 years? Question clear, na? Car life is 10 years. Okay, but I want to use it for after 6 years I'll sell it off and buy one more one. Right now I should use it. What is the life here? 6 years. Okay, E10 years is called economic life. It is economic life, not useful life. Okay, both are not one and the same. That is economic life. Understood? Next. There here three things are there. One, you have to review. Remember this, you have to review every year. Every year. Maybe MCQ question can come like that. What all you should review? First one is method of depreciation. Okay, method of depreciation. Done. Second one, useful life. Maybe you thought today 6 years. Your mind can change, you know. Correct, na? Your mind can change. Let's say we'll say I'll use it for little more. Got it? Right. Then residual value. Right. Any change. Right. Any significant change. Account prospectively. As we learned yesterday in days 8, this is a change in estimation basically. Correct, na? Right. One more small point with respect to intangible asset I need to speak. Okay, intangible asset. Yeah. So if it is an intangible asset, correct, na? First, useful life is the point here. Useful life. Under intangible asset, there is a concept of infinite life, finite life. Infinite, correct, na? That is infinite life. How many years life? I don't know. Infinity. Correct? Infinity. When it is infinity, no depreciation. If it is infinity, no depreciation. Correct? Yes. Yes, here depreciation. Depreciation as usual. Nothing too specific to discuss. Okay. Here what are we supposed to do? Test for impairment. Test for impairment. Every year only when there is an indication occurs. Every year. If it is infinite asset, mandatorily every year it is supposed to be tested. This is exception to the basic rule of 36. Okay, right. Remember, IAS or Ind AS 36, impairment loss. Normal rule is what? What is normal rules? Normal rule is only when indication. Only when indication exists. Only when indication exists. But except. Except. What is the situation? Situation number 1. Right. Intangible asset. Yes. With infinite life. Next. Intangible asset under development. UD. IAUD. If it is under development, it has to be tested for impairment every year. That's why in the intangible asset under development, they can keep a point called recoverable amount karke rakh sakta. It is required to be tested for every year. Okay. And the third one is goodwill arising from business combination. The goodwill is arising from business combination, that also has to be tested every year whether or not indication exists. Okay, right. It is there, no, AAUD ka, but actually there are, if you see financial statements of big companies also, there will be intangible asset under development, but in their accounting policy or nowhere they will mention about impairment tested and no impairment. A sentence it will not come. It is must to be done actually. as per the standard. Okay, not a big mistake also. But that is there. Rule is there always. I hope you understood. Right. So this is with respect to infinite, finite balance, intangible asset may normal. There is, I mean, useful life only different, finite, infinite concept. Okay, right. Anyhow, this side cost model, normal depreciation, whatever PPE co applicable, investment property co, same rule is applicable. Right. And one concept for investment property. Yeah, investment property specific, which cannot be linked with other things. Okay, what is this here? Important is reclassification. Reclassification. Yeah, where it will go? Investment property can become property, plant and equipment, or it can become inventory. If your company business only buying, selling the lands and etc., then it can be inventory also to the company. Okay, sir, when can you reclassify? It is not based on the intentions of the management. No, not intention of the management. Intentions are not considered. Okay, there is evidence that usage is changed. What is it? Is based on what? It is based on evidence of usage. Evidence of usage. You should see the evidence, correct? Strictly. Suppose it is an intangible asset so far. Sorry, IP, investment property so far. Correct? Means what? Means you rented out to somebody. Now what is that happened? You ask them to, they already people have vacated. Correct? People have vacated that place. I thought of using, not thought of. You already gave a notice to the tenant saying that boss, please leave. Okay. Why you are asking them to leave? Yes, we have got, I want to use this space for my own business purpose. I hope you understood. If there is an evidence, that day it is supposed to be transferred to, that day it should be transferred to PPE. Otherwise, it should not be transferred to PPE. Is it clear? Evidence should be there. I mean, I can see that. Evidence is a matter of fact. Okay, it is not a estimation. Correct? I can see. Fine. That's what. They have vacated. Fine. So then PPE. At what amount, sir? Very simple. When you are shifting from here to here or here to here. Correct? Na? First, initially, what will happen? Initially at book value. That's all. Initially at book value. So there will not be any gain or loss. Oh, there can be gain or loss. Correct. Now, are you selling it to somebody? No. It is your asset only. Just a name change, heading change is happening. Just because heading change is happening. Correct. Now, how can there be gain or loss? So there cannot be any gain or loss. I hope you understood. Right. Sir, IP was 100, sir. Yes, IP moved to inventory 100, sir. Correct. First you shift it to 100. On the balance sheet date, inventory should be tested at cost or NRV, whichever is lower. Test. That time NRV is lower, charge off. I hope you understood. But today, at the time of reclassification, it should be happening at carrying amount. I hope you understood. Right. Sir, I am following IP. IP may you will be following cost model. Agree. But in PPE, sir, I am following for the buildings revaluation model I am following. Correct. Now, what are you following? Correct. Now, revaluation model you following. Whatever your book value carrying amount is equal to 1000. First, you should go to step number 1. You should go to 1000. Correct, na? Right. Then revalue. Then you are supposed to revalue. First, you bring it to PPE classification at 1000. Afterwards, you revalue it. Are you getting my point? It's supposed to be like this. Next, one more question should come. Okay, sir, it is a PPE, sir. Now I am reclassifying as an investment property. हो सकता ना? Right. Sir, PPE में I was following revaluation model I am following. Very nice. Say example, this is my balance sheet, sir. Okay. So there is a building that is equal to 1000 rupees. There is revaluation reserve 200 rupees behind. Agree. Now I am going to this investment property. As you are aware, investment property is only cost model. Now what should I do? Which value? 800 or 1000? Question clear? Huh? Hmm? It should be at 1000 only. Sir, but what about the revaluation reserve? Continue the revaluation reserve till the asset is sold. Okay. So continue to hold revaluation reserve till asset is sold. Okay, asset this it will continue, but subsequently you will not revalue. That's all. Correct now, but no revaluation afterwards. No revaluation afterwards. That is the first point to be remembered. Huh. Hmm. Hmm. You can use it. You can transfer it to retained earnings only. You can transfer considering the excess depreciation concept. That is optional, not mandatory. I'll tell that also. Okay, right. No revaluation. This is clear, no? Key concept is clear, no? It will continue. But here it will be building will be under IP investment property में आ जाएगा 1000 will be only depreciated. No further revaluation is going to take place. Clear? Right. One more question before going to. First, what should I do? First, what should I do? Suppose today I want to revalue. First, do you depreciate? Then you will do revaluation, or first revaluation afterwards you will depreciate. Yes. So sequence that is important. Sequence important. Otherwise, answer also will change. Correct. Now, first you are supposed to do follow depreciation. The next you are to follow the revaluation. Third, you should follow impairment loss. Okay. These are important points, right? So depreciation first you should do. Then check for revaluation. It may be increasing, decreasing, whatever it is that you account for, right? Afterwards, if there is an impairment, is it possible? Possible. Depends upon the selling expenditure is very high means, because for a fair market value, selling cost will not be considered. For impairment loss, correct na? Selling fair market value minus selling cost will be reduced. If the selling cost is huge, then there will be something to be done, impairment loss. If selling costs are not much, forget, then there is no impairment loss. It will stop at 2 only. Next, whatever I am explaining, this is voluntary. Okay, this is a voluntary rule. Yeah, it is not mandatory, not as per the stand, not as per. This is applicable for 16 plus 38, both. Same rule is there for intangible asset and tangible asset. Okay, remember. Yeah, voluntary rule. What is this voluntary rule basically? As I said, voluntary. Voluntary in the sense what? It should be part of accounting policy choice. It should be part of accounting policy choice. You must have mentioned in the accounting policy. We are following like this. Otherwise, it won't happen. Okay. What is that? Simple. See, you have depreciated. Say a simple example I'll give you that will give you full clarity. Okay, rather than anything else. Suppose the cost of the asset is equal to say 1000. Say this is a plant and machinery assume. Okay, 2 years depreciation you have done. Okay, 2 years depreciation is equal to 200. Then it is equal to 800 rupees. Now, today you did the fair market valuation. Fair market value is equal to 1500. Okay. So, there is a gain of 700 rupees is there. So, I will say revaluation gain. I am adding somehow, whatever it is, maybe accumulated depreciation, whatever it is, end of the day added. That is equal to 1500. Agree? Right. When I say 200, that is nothing but 10 years life. Correct? Na? SLM method. Residual value is equal to 0. Agree? That's how 2 years ka depreciation 200 rupees has come. Now, third year depreciation. Third year depreciation, what are you supposed to do? 1500 divided by 8 years. How much number? 187.188, I'll take it. 188, I'll take it. Agree? Right. So, depreciation ka what is the journal entry will record? That is depreciation expense account debit. Correct? Na? No revaluation reserve will be impacted even though you have a revaluation reserve. No. Correct? Na? Depreciation expense account debit to accumulated depreciation. That is equal to 188, 188. Agree? Clear. Now, the question. Next question is what, my dear? This is 188, 188 all fine. Correct? Right. So, now excess depreciation. If I have not revalued, what would have been my depreciation? 100 only, na? What is the excess depreciation? Obviously. Correct, na? That is equal to 88. The 88 part, you can transfer from the revaluation reserve to retained earnings, so you can transfer. That is what optional to you. If you wish to do, that is as per the accounting policy, yes. That is equal to 88. Clear? 88 part you can do, not mandate. Okay, but the question says specifically we are doing like that, means you should be aware of this. Okay, one time they asked like that question, linked with impairment. E option they have mentioned very clearly that we are following like this. If you are not aware that there is something like this, then you will not understand that line what they have mentioned only in the question. Correct, obviously. Fine. Right, my dear. I think we are done with almost everything. Right. I'll take you through one question. This is which standard? Yeah. Yes, 20. I'll go to 40. Investment property 40 में there is one big question which I kept it here. Okay. I think I kept in the other book. That was a very good question. No, it is not here right now. Fine. Yeah, but that is a good question. Good question in the sense, just try to confuse the revaluation model. Correct. Now he will give like 1, 2 building 1, building 2, prepared property, plant and equipment 1, 2, and the other building he will say that I have rented out. For this building I followed revaluation model, he will tell. Other building ko, one building ko you followed cost model, another building ko you followed revaluation model. Then you should tell, boss, building is one class only. Both the buildings you should follow one model. Correct, na? All, if you had followed cost model, your number would have been this number. Otherwise, this is revaluation model, so this is the number. For investment, this you said you rented out. This should be at cost model only supposed to be there. Correct, na? So that reversal, that big sum once upon a time, not one time, two times they have asked same question. That is one good question for revision. Okay, yeah, one time please look at it. That will be very much helpful to you. Right? Any question? Hmm. Hmm. That's all. Our journal entry will not be there. If nothing is mentioned in your accounting policy, this will not be there. Only this. Again, you can write one line, depreciation, and all the time depreciation should be charged to P&L, or it can be capitalized with some other asset. If this asset is used for the construction of another asset. Understand? Suppose I have a machine. Correct, na? This machine I am using it for a development of intangible asset. Okay. This machine life is what? Life may be 10 years. But development may be happening for 3 years only. Yeah, afterwards, after that 7 years, the machine will be used for some other purpose. Okay, the 3 years ka depreciation should not be charged off, should be capitalized with development. Okay, yeah, you have a salary dedicated this for construction of another building. Full time is utilized for that purpose. Right. Building construction may happen for another 2-3 years. The 2-3 years depreciation should be capitalized to the building, not to the charge to profit and loss statement. That concept is there. But otherwise, it will never be adjusted with the revaluation reserve. Your revaluation reserve has to be continued till the sale of the asset. It happens always. Shall we? Right? Yeah. So this is the crucial points of accounting Ind AS 1638 plus 40. Okay. Right. Take a small break and come back. Chalo. Let's plan. What is that? Ind AS 41. Agriculture. I don't know why he bothered about agriculture so much. He's asking so much. They have asked number of times. Correct. No? But what is there in the standard and why he wants to test? Correct. No? I mean, sometime, no, first time, once the Ind AS is been first time applicable, I should say it's a sadism, I should call. Correct word maybe. Insurance related he kept. Ind AS 104. Okay, that time it was applicable. After second attempt, they have removed the insurance. Then they realized this is sectoral standards. What is the need for a student to learn? See, everybody will not go to insurance sector now. Agree or not? Ind AS 104, Ind AS 106, Ind AS 114. These are all sectoral standards. It will not be applicable to every, I mean, one software company, one manufacturing company, not applicable. What is the point of asking? Simply sadism. First question, mandatory question, he asked the insurance wala. Mandatory question he asked. Seriously. Like I felt like too much this is. If you ask me correctly, do you know about insurance business? I will say I know little only. Seriously. I never looked at insurance business. You know means okay, I know. Not that I am expert in that. Correct na? But if you ask a student, Papa, or first time Ind AS only he's learning, what is Ind AS only go? They don't know. Sectoral specialization, first 6 marks mandatory question, 14 marks something consolidation he asked, 6 marks he asked this. First time. Thank God, within 2 attempts time, they realized that and they removed it from the syllabus. And first batch, worst problem, syllabus is not just, syllabus is consolidation as per Ind AS, consolidation as per AS. Seriously, it was there for 2 attempts, I think. Same. Like that, amalgamation also. Consolidation 103 plus 14. This is entirely different. Consolidation here, correct now. Goodwill calculations and etc. different. AS 21 plus Ind AS 103, 110. If you ask, no, it's too much for a student to catch it. Got it? No? Unless until you have good time, amount of time you did practically something, na, then you will be able to bifurcate. Otherwise, it's going to be too big to understand. Subsequently, again, I told now after two attempts, they realized this is too much. They removed the AS wala fully removed. AS wala fully removed. Their concept is CA inter mein, AS mein these standards were not there. So let's test here. But you wanted to test, already you are testing PhD testing you are doing. Why this BCom testing of 21, AS 21? Correct, na? 110 only you are asking directly. 110 plus 103 when you are asking. AS 21, AS 14, what is the point of asking? Correct, and confusing more and too much actually. At least you guys are better lucky some way, I should say. Right. Huh. So Ind AS 41, when I say agriculture, okay, agriculture, here there are two. Agriculture means what? Basically, what it covers? Other than bearer plant. Correct, na? Simply, can I say other than bearer plant? Yeah. Why bear? What is bearer plant? Bearer plant is dealt by Ind AS 16. Correct, na? Yeah. Bearer plant is which bears the agriculture produce, where the life is more than 12 months. Correct, na? Not expected to be remote likelihood of selling it as a product. Some trees, big trees and all, you will consider it as a bearer plant. Yeah. So here what will be there, my dear? Here agriculture produce will be there basically. Agriculture produce. Okay. Next is, what is that? Plants and animals. Living plants and animals. Living plants and animals. Obviously dealt by Ind AS 41. Correct. Next. E production at the point of harvesting. Yeah, in simple words, you know what we can say? At the point of harvest means when the fruit is attached to the tree, then 41. Once you pluck it, then it will become inventory. Okay, right. When it is attached to the tree, then it is this one. Once, correct now, once detached, then it is going to be inventory in days 2. Once it is detached, done, right. So whether it is agriculture product or not, that level questions have never been asked. Okay, so that deeper you don't need to go. But what was the question all the time was for measurement. Okay, initial measurement, subsequent measurement, correct? Na? That's all it was the question. And once upon a time, one time they have asked a question, some Nilgiris related, some small question had come with respect to the government grant related to agriculture. That was only one time the question had come. Subsequently, same sheep, same cows, ade question will come. Okay, right, that's it. So here again, measurement, when I directly go to recognition, correct, recognition and measurement. Yeah. We look at one small sum also, then you will also get an idea. One small quick revision of all the concepts will happen. Yes. See, first I will say it is initially and subsequently. Initially and subsequently. Both. Correct. Na? Initially, subsequently, it is supposed to be at fair market value minus selling cost. Initially and subsequently, both. I mean, when, at the time of purchasing also, fair market value minus selling cost. On the balance sheet date also, fair market value minus selling cost. And obviously, if there is any gain or loss, that should be transferred to profit and loss statement. If there is a gain or loss, that should be transferred to profit and loss statement. Okay, straight away transfer it to profit and loss. Agree? Right. So example, simple example, what you say? Like say you have a cow, you have heard whatever dairy farms or whatever it you say. Correct. Now, yes. Now it gave a birth to calf. Right. Fair market value at the time of birth will not account it. But on 31st March, correct now, 31st March May, what will happen? The calf may be having less than 1 year of life. I mean, already correct now, 1 year old or less than 1 year old calf. What is the value of it? Yes, market value is determinable. First and foremost thing, remember. Okay, fair market value I can't determine. This is a joke. Okay, 100% you will be able to determine. Right, most of the circumstances you will be able to determine, except such circumstance like I have something agriculture farm or something which is on some hill or somewhere, correct na? I don't have comparability or something, that is a rare circumstance. Otherwise It is one kind of rebuttable assumptions to the standard. Say rebuttable assumption means arguing. Standard is arguing. What is it argue? If you say I cannot determine fair market value, tell me how karke, it will ask. You prove yourself that it's not possible for me to determine the fair market value. Anyhow, it is supposed to be at fair market value only. Got it? Right. I told na, right. First of all, for the agriculture produce ko there is no option only. It has to be at fair market value. You don't have a cost concept. Here for this what's are, this is like fair market value only first priority. If you can prove by chance. You understood my point? If you can prove by chance fair market value cannot be determined, then go by the cost. But again, go by the cost if you can prove this is okay na, go by the cost. But again, I am telling you, you can go by the cost, but again you have to look for fair market. Current year may cost may I went. Understood? You should look for the second, next year has come, next year balance sheet. If there is a way to find out the fair market value, please jump to fair market value. It's not like cost I am following means lifetime I will be following the cost. No, you have to just okay, today I couldn't determine fair market value, agreed. Got it? But next year what are you supposed to do? Look for fair market value. Available, jump into fair market value. Not available, continue your old cost model. Hope you understand. That is important. Why for agriculture fair market value? Hey, you are producing mango. If you say mango does not have market, then why are you producing man? Illogical. Correct, na? So agree, na? That is a basic. Agriculture produce is meant for what? To sell only. When there is no market, then why did you produce? It doesn't work. That's why they have not given a choice only. It has to be at fair market only. No cost concept. Correct? The cost concept doesn't work over there. Done. Next point. Listen here. If you are following the fair market value, if you have received government grant, then correct. Now government grant received, E standard only will be dealt. That is 41 will be dealt. Are you getting my point? Right. Here also, sir. Sir, I am following fair market value. What are you following? Fair market value. You have received government grant. Then 41 only is applicable. One paragraph will talk about government grants received with respect to agriculture item. Sir, I have followed cost model. Kya follow? Kya followed? Cost model. I have received government grant. Then you have to go to Ind AS 20. This is Ind AS 20 you have to follow. Point is clear? Okay, right. So, if you are measuring at fair market value to that agriculture produce or to the agriculture, this one, whatever it is, the item, I mean living animals and etc. Are getting my point? Then if there is a government grant, then you should go to 41. Same standard only will be there. If you are measuring at cost, then you have to refer Ind AS 20. Normal standards ko you have to go with. Is it clear? Correct. Next. So here as I said, calf, correct na, on 31st March, market value will be there. Yes, for every animal ko, correct na. Obviously calves, cows, goats, everything sheep. Obviously markets are available. Can find out the value of it. You should measure it at this amount. Fine. Right. So that is the first and foremost point. Anything else here? Entirely about only fair market valuation. Correct, no? Right? Right. Let's try the first question. One question we'll try. If I missed out some major point or something, no, then I'll explain it then and there. That is better option. Right? So these first initial questions are correct. See, this is what I was trying to tell. For the biological assets and agricultural produce, initially correct at the time of when you get the control over. Subsequently also, that is on the every balance sheet date, fair market value minus selling cost or cost to sell. Correct na? The fair value change that should be transferred to profit and loss statement. Done. So there is an exception. Yes, whether that exception is applicable not for the produce, that may be applicable for the biological assets. But our exception also, correct, as I told, initially if you presume that initial cost you cannot measure, then you can go by the cost model. Allowed. Correct now. But once the fair value of the biological assets are measurable, Yes, you have to come back to fair market value. It's not your choice. Okay, I followed cost model, so I'll lifetime continuation. No, no, you have to come back to fair value. That date it was not up. That date it was not measurable. Correct? Fine. Now you are able to measure it now. Clear? That is what the basic point. This is very basic question. Agriculture produce. These are all simple questions. Government grants. So, right. So you read this question. This was once upon a time asked. I think I need to get the other material. Okay, fine. I'll do that. Okay, concept. This is once upon a time, long ago question only, but doesn't matter. Just read it for a minute. Arun Limited is an entity engaged in plantation farming of large scale, diversified across the India. On 1st April 2021, the company received a government grant. Okay, government grant related. Okay, let me clear it here itself. Government grant related. Anyhow, one simple chart is there, more than sufficient. As I told you, you are going by the cost model. Then this standard is not applicable. Ind AS 20 will be applicable. In simple words, I closed it. Correct. Now I am following the fair value model. Then you have to refer our standards. Ind AS 41 only will be talking about government grants. First question what you should ask, is there is it a conditional grant? Means what? You should satisfy. Correct, na? You should satisfy in the sense, there was in Telangana government, there was some sheep scheme was there. Okay. So if you can buy the sheep, but you have to, you have to keep it with you. Tomorrow only, today I'll buy and tomorrow I'll sell it. No, it will not be applicable. Got it. So you have to, raise the sheep, the herd, correct, na? So for a period of like 2 years or 3 years, something like that. Subsequently, you will be able to sell it. Some conditions are there. Once you satisfy the conditions, then the money will come to you. Otherwise, money will not be coming, or money may be refundable. If you already they have given the money, then it may be refundable to you. Such conditions will be there. Okay. Again, sometime what happens, agriculture, suppose you are giving the paddy right now. Okay. So paddy ko it may not be work. They will not give the grant. You have your crop should be jawar or something like that, example. Then only the condition is satisfied. You understood my point? Condition, is it conditional grant? Means if you satisfy, you will get it. Do not satisfy, you will not get it. Yes, there are conditions. Okay, answer may be condition, or the answer may be correct. No conditions are there. Simply money has come. Simply money has come, everywhere same concept. Transfer it to P&L. When it is become receivable. Receivable means obviously you should file the application. Application ko other party should approve it. Correct, na? You don't need to satisfy condition. When you want a government grant, what are you supposed to do? Some procedure will be there. Some application should be filled with the relevant documentation and etc. Then should be given to government authority. That guy should, correct, na? Should put a seal and approve it. That day it is receivable. Money may come after 1 month or 2 months. That's secondary. Are you getting my point? So it is receivable, right? Approved by the government authority, receivable. I can take it to P&L, right? No, sir, I have some conditions to attach it to it, right? Recognize it only. All the conditions are correct. Na? All the conditions are satisfied. It is not like reasonable assurance I have to satisfy condition. No, here this is not reasonable assurance basis. Have you satisfied? Are satisfied. The reason here why reasonable assurance concept they have not brought in. Reasonable assurance means I'll take employees of 10 employees. If government says employ them for 3 years, afterwards if you want to throw them out, throw. But you have to keep them for 3 years. Understood? Here I am very sure I'll keep these guys with me only for 10 years. Possible. Okay. But this is related to agriculture, Amma. Okay. Right. You have to raise the sheep for 3 years. If I say some disease will come, my dear. Correct, na? That is, so many natural calamities can come. Suppose you have a crop or something. The conditions your surety will not work there, because something beyond a human control is there. I hope you understand. You are dealing with living animal or living plant. Life say you are dealing. That is not under your assurance or something. That's why they said, once you satisfy all the conditions, then take your money, take it to profit and loss. Till that time, 5 years completed, completed. Have you satisfied condition? Satisfied. At the end of the 5th year, you take it to your P&L. Not a problem. Till that time, already money has come. Yeah, put it as a deferred income, not a problem. But don't transfer it to P&L statement immediately. That's all is the concept. Right. So, with that background, please have a look at this question. So, what is there, my dear? So, on 1st April, the company has received a government grant for 20 lakh rupees subject to condition that it will continue to engage the plantation of eucalyptus tree for a coming period of 5 years. Okay, right, they will not cut it or something, nothing will happen. The management has a reasonable assurance that the entity will comply with the conditions of engaging. Correct, na? Right. 1 second. Advise the accounting treatment. Yes. So, what is that they are telling? Management is looking at Ind AS 20. Fine. Right. Now, first eucalyptus tree, whatever you call, is it a bearer plant? Eucalyptus seeds will not be there. There won't be any agriculture produce. Okay. Eucalyptus you must have seen. In the city also you will find. Nilgiri, ade eucalyptus first. Okay. Yeah, whatever the oil and all what you do, no, that is a byproduct kind of thing. That is not the purpose. It is basically meant for the wood. Eucalyptus tree is meant for what? Wood purpose, not for the eucalyptus leaves or something. These are all byproducts for them. Understood? Fine. So, for this you now look at what is that they are telling? I have a reasonable assurance. I wanted to follow. It is actually a biological asset. It is not a bearer plant. Hope you understand what I say. It is a, what is that? It is meant for the wood. When I say it is meant for the wood, what will happen? Produce is not a separate mango tree. Mango is a produce. Here, what is the produce? Tree itself is a produce. Correct. So, it is not a bearer plant. Correctly speaking, they should fall under 41. Right? The answer also, just have a look at it. See this, it will satisfy both the ways. Assuming that, assuming this, karke we have, I mean, you have given. Have you read the question, answer? Was it convincing? Correct. Now, if you do, too much assumptions are there. Correct. Now, if you can assume one way, if somebody knows about eucalyptus, correct. Now, that should be there. I know it, but it doesn't mean that you should know it. Correct. Now, eucalyptus tree is not a bearer plant. That should be a biological asset. Yes, every living plant is an asset, biological asset, but it doesn't give any fruit separately. Whatever the fruit or leaves or something, those are all byproducts. It is basically meant for the wood purpose. Yes, if you know that way, you can think it. This is it, but subsequently never asked such kind of question. One time he tested and tried. Got it? But such kind of questions, if you find in exam, what you should do? Go to next question. Don't break your head. Okay, don't waste time. First go to next question. If you have some time, correct na? Then come back. And if you are confident, see there are only maximum 2 possibilities are there. Correct na? Then we'll go in both the possibilities. I can explain and close it. Best way. Right? And this tree, this may be that, this may be this. Too much I need to apply brain means better to come back after completing all other standards. No other questions complete karke aajo. Don't waste unnecessarily time. I hope you understood. Do we need to discuss or shall I go ahead? We can go ahead, na? Right. Give me little time. That one question, other, yeah. So let's see some practice questions book mein. Okay. Yeah, one small question. Let me start and then we'll go to the next question. Better question also, obviously. Entity purchased a cattle. You know, cattle group of animals. Correct, na? On auction. Fine. On 30th June, you bought it. So date of transaction is 30th June. You bought it for 1 lakh. Cost of transporting the cattle back to my entity farm is 1000. Agree. Selling price of the cattle, correct na, on 31st March. This is a different date. Correct. Year end date is equal to 1,10,000. Right. the company would have to incur similar transportation cost if they sell it at the auction. If they want to sell it back, they have to spend this transportation cost. It is not only while buying, while selling also you are supposed to spend this. In addition, there is an auctioneer fees of 2% also on the selling price. You have to pay to somebody on where you are doing the auction business. There 2% of the commission means 1 lakh mein 2000 you are supposed to pay. Now you have not paid. Why you have not paid? Because you bought it, not you sold it. Okay, the auctioneer charges 2% on the selling price from both, from both, that is the buyer as well as the seller. But listen, from the buyer it is a cost, for the seller it is a loss expenditure, correct na? It's okay. Calculate the amount at which cattle to be recognized in the books initially and as on the balance sheet date. Yeah, first concept is very simple, ma. Initially and subsequently it should be measured at, not at cost, it should be at fair market value minus selling cost, correct na? If I sell, first thing what you should do, right, my suggestion is like 2 cash you write it first. What all the amount is lost for you, got my point? What is the amount you lost, you keep that number. Next, the biological asset, something is there, biological asset account debit. Now here you mention that fair market value minus selling cost, some number x number will come. This obviously there will be difference, my dear. Difference amount will be your transaction cost or something, it will be charged to profit and loss statement. First point to be remembered. Is it clear to you? First what you should determine? Cash. Cash outflow kitna? That is very clear, available to you. Right. Tell me how much you have spent here? 1 lakh rupees you spent, plus 1000 rupees you spent, plus 2% also you have spent. Correct na? So that is equal to how much you spent? 103,000 rupees you have spent. Do you agree with me? Right. So this is equal to 103,000. I am just filling the blank. Next. Tell me, if you sell FMV minus selling cost. See, the concept itself, FMV means what first of all? Full form don't. FMV means fair market value, I know. But FMV means exit price. What is it? Exit price. Exit price means selling price, not buying price. Correct na? So that's why selling cost also they have included. Agreed? Right. There is a beautiful logic. Why FMV karke? I also had thought about it. Beautiful logic is that to make you understand it will take time. This is not the right time. It doesn't actually for you not required. You should know. It should be measured at this. Aste. Ee time nalli ade correct. Okay na? After clearance of exam, then we will discuss deeper and deeper. Okay, right. Because again, agriculture things, these things will not be handled by everybody in life. Agree or not? Everybody will get an opportunity. Yeah. No, it's not a manufacturing, it's not a software, not some service industry or something. This is different kind of industry. Okay. Now tell me, if you sell it, you would have sold for 1 lakh. Correct? Na? I bought it for 1 lakh means other party sold for 1 lakh only. No, that way you should think. So 1 lakh rupees ko sell kiya. Next, I minus selling cost. So this while selling also I will be incurring 1000. While selling also I will be incurring 2000. Correct? So they directly 3000 rupees. That means 97,000 rupees I should keep it here. Agreed? So and there is a loss of how much, my dear? Loss of 6,000 rupees. That will be transferred to P&L. Loss on initial recognition. Directly profit and loss ko charge karo. Is it clear now? Hello? If you put it entry na, clarity will come. There is a possibility less and sequence correctly. First cash book karo, then asset you book, then go to P&L balance. Then the concept will become easy. That's all. There is no need to spend too much of time. Second concept. Next. Now you have recognized the asset at what number? 97,000. Correct na? Now what is that you are supposed to do? First number is 97,000. What is the question is asking? Initial recognition and balance sheet is asking. If you sell it at on 31st March, how much it will come? 1,10,000 rupees will be there. Minus 1000 rupees transportation cost, same number will continue. Minus 2,000, 2% of 110, 2,200. Correct na? 2,200 ko sale karo. Cut the number, my dear. 106, 800. Correct na? 106, 800 should be the new number. Should be measured. From where? From here to here. Agree na? So 107, 106,800 minus 97,000 rupees karo my dear. 9,000, 9,800 rupees is going to be your gain, correct? That should be transferred to, 1 second. The cattle should be measured at fair value of 109,000 plus estimated cost of 2,200, correct? That is nothing but 106,000 rupees, 106,000 rupees, correct? Na? Yeah, here this is only for the initial outflow. Here I have not mentioned, so you can write like what is the total gain on the balance sheet date. On the balance sheet date, gain is equal to 9,800. That's all, correct. Simple, right? So same question, like this question is the normal asked already. Yeah, this is the question here. They, I don't know why they like this question, correct na? This question again, other table it will come. Already 2 times, 3 times or 4 times they asked, right? If you observe overallly, milk is agriculture produce, correct na? It should be measured at, initially measurement will not be there, closing stock only measurement. It is not like milk you are not buying, no, first of all. What is the market value of milk? That should be recognized as a produce. That's all. No gain, entirely gain, 0 to milk is drawn now, correct na? The gain, entirely gain this is. So XY Limited is a XY Limited is a farming entity where the cows are milked on a daily basis. Agreed. Milk is kept in a cold storage immediately after milking, sold to retail distributors on a weekly basis. That is normally it will happen. They will keep in the cold storage and then they will sell it. Daily basis, correct, but not the smaller ones will not do. These all big parties will do like this only. Correct. Na? Whatever you will get Nandini milk or somebody other milk, no, you will feel fresh today only dated. No, my dear, already 1 week before or 10 days before they milked. Actually speaking, that's not fresh. That's not coming today. Understood? That can happen only in villages. In cities, don't even imagine that way. Right? On 1st April 2021, XC Limited had a herd of 500 cows. Okay, he had a, correct, had a 500 cows was there already, right? Were all these 3 years old, which the age is automatically changes along with the time, correct? That's why you should be very careful. 1st April, 500 cows, 3 years old. So on 31st March, their value 4 years old it will become, correct? Na? During the year, some of the cows became sick. On 30th September, 20 cows died. Okay, so out of 500 minus 20, yeah. So on, I mean 480 is minus 20, correct. On 1st October again we bought 20 replacement cows at the rate of, correct, 21,000 each you purchased, each, correct. And these 20 cows were 1 year old when they were purchased. They are 1 year old, correct, but as on 31st March they will be 1.5 year old, correct na? On 31st March aa gaya, we have had a 1000 liter of milk. In milk rate you take it 1000 liter into a rate apply karo, that is the my closing stock, that's all. Okay, in the cold storage has not been sold to the retail distributor, that's fine, there is a stock with you. Market price of the milk on this day 20 per liter, multiply this, that is your number. When the selling the milk distributor, XY Limited incur selling cost of 1 rupee per, fine, 20 minus 1. These amounts did not change during the March 2021. You are expected to change during April 2022. It's okay. That is a additional information. Now you have to measure the fair value. Tell me, my dear, how many cows you have? 400 illa, 500 are there. Correct. Now out of 500, what is that? 480 plus 20. Agree? Yeah. Correct. Now, E 480 what? 4 years old. And this one is 1.5 years old. And you have a milk. Correct. Now that is 1000. Right. This is equal to 1000 into 19 rupees. That is the separate number, close matter. Now 4 years ka, tell me ma. As on 31st March. Yeah, this is what I am talking. Correct na? What is as on 31st March? How many years old? 4 years old. How much is the number? 26,000. Correct na? So 26,500 into 480 apply karo. Done. Next, as on this date, what is the rate, my dear? 23,500 also you are supposed to apply. Agree? Correct na? Right. And As on 3 years old, how much, my dear? 3 years old, how much? E 29,000 is the opening stock. 480 ka opening stock is how much? Correct na? 400, 500 ka opening stock is 29,000. They must have measured initially at 29,000 rupees or not? Fair market value minus selling cost. That is at how many numbers? 500 into 29,000 rupees they must have measured. Agree na? Now you measure these two numbers, you measure it, and again this is opening stock. Agree? Right. Plus, do you have an additions or not? Loss is lost. A loss will be automatically adjusted in the difference amount. Okay na? You have added. How much you added, my dear? 1 year old ka you have added. Anyhow, they only gave 21,000. What is the number they gave? 21,000 rupees is the replacement. Yes, 21,000 rupees is the replacement value. He has not given selling price and etc. etc. So 21,000. A 20 house with 21,000 rupees will be added. Correct? Deletion क्या करना? Deletion कुछ नहीं करना. Directly you take the closing stock number, you take it. Closing stock number, E number already correct now. We have written here already number. A number you take it. Then the difference will be the transfer to profit and loss statement. That's all it will happen. Is it so difficult? Actually not difficult. But slowly if you understand, 1 or 2 times if you practice this sum, correct now. By lucky, if it comes, 6 out of 6 or 8 out of 8, whatever it is, the number of marks. Obviously not for 4 marks. Normally 6 to 8 marks is the question they will be giving. I hope you understand. Right. See, last के लिए here they have recorded as a separate journal entry. Last के लिए you don't need to pass a separate journal entry for last. Have you understood why? Why you understood? Tell me. Anyhow, on the fair valuation adjustment में it automatically takes place. No, I will write separate entry. Right here. End of the day, e loss, a gain, correct na, will be presented as a net only. That is just for your satisfaction. You want to do it. I don't have any objection. Have you understood my point? That's why I said last scale is separately. When I was explaining on the top also, I said last scale is separately not required. Okay, opening stock, purchases, correct na? Closing stock is there. Any plus or minus will be automatically, loss will be automatically balancing figure. Anyhow, balancing figure has to go to P&L only na. Yeah, when there is loss is there, where will it go? Loss account. It will go to P&L only, it will go. It won't go anywhere. Hope you understood this. Need to work out once again with the calculator when you sit and work out. That will be easy, you will find it. Shall we move ahead? Right, we are done with Ind AS 41. Almost maximum possibilities we have taken care. Right. So, chalo, now let's go to the next standard. Next standard I said what? Ind AS 105. 105. 105 non-current assets held for sale. Yes, non-current assets held for sale and discontinuing operations. Most of the times he is tested only the non-current assets held for sale. Discontinuing operation rarely tested, correctly speaking. Okay, less tested or rarely tested, I should say. Fine, when they will test I don't know, but fine. This was already tested for I think more than 2 times or 3 times, and number of marks also not for 5-6 marks, like 10 to 12 marks question have come from non-current assets held for sale, and especially their focus was group of assets when you have sold it, not individual assets selling. They have never targeted always group of assets sold together. Okay na? Right, listen carefully. Non-current assets held for sale. First, overallly if you see, overallly the standard if you look at, when to classify, correct na? When to classify, it is a classification. When to classify, when you satisfy the condition first. Yeah, you have to satisfy the conditions. Sir, management intention, no my dear, there is no intentions of management are not considered here. Here also matter of fact, we have to see that, correct na? Here there should be fact. first and foremost condition, correct na? It is ready to sell in the existing condition. The first point, this you need to understand and close it. What do you mean by correct na? Suppose this building is there, sir, I want to classify as held for sale. Okay, first question I will ask you, will you sell as it is? No sir, ಸ್ವಲ್ಪ decoration I should do, then I will sell it. Then stop. That you classify next year, not now. Have you understood my point? ఈ asset ko as it is you want to sell, right? That date, yes, today I all decoration all done, now I will be selling. Once the decoration part or some repair is there, building hai na, correct na, somebody tenant occupied, now that guy left, I want to sell off. Sell off, that is up to you, I don't have any problem, correct? Now I want to do repair, I want to do little bit of painting or whatever, assume situation. Then I thought like I will be able to sell it at a better price. If I show the full gullies building, if I show it, no, nobody will buy only. Mindset of the people, nothing wrong in that. All are correct only. Correct. I want to do means you first to complete all this, man. Complete after completion 15 days it has happened. After 15 days, then you classify it as this one. Correct na? Right. First thing. Next is what? Oh, exactly the terminology. First is your proactiveness in the selling. Correct na? Can I refer the one better? Any words? Do you remember? Yeah. These are the points. First point, directly we can say. Fine. When do you say it is saleable? First, the asset is disposable. This is available for immediate sale, as I told you, right? Correct na? And the sale is highly probable. This is what? Okay, sale is highly probable. Yeah, sale is highly probable. When do you say it is highly probable, my dear? Highly probable is based on two things. First, what is the price you are quoting? Correct na? Agree or not? The price quoting. Whatever you quoted price, that should be reasonable to the market or not? Correct na? Say this are one just example. Bottle is not a non-current asset held for sale. Obviously, I know that. Example, the market value of this is equal to 100, sir. If I say, sir, no, my bottle is different, this has a different design, that's why I'm selling at 105. Makes sense, not a problem. Correct. Are you getting my point? My next building got sold for 21,000 rupees per SFT. If I say this building I don't need to sell at 21,000, I may quote at 23,500. Why, sir? This is a corner building, sir. Correct na? My construction is different, that is Dabba construction, my is better construction. You can tell na, nothing wrong. Every building is not same. It has its own positive, negative, so you can quote. If you're quoting little high and up and no, that's fine. But that is sold for 20,000 per SFT. Now, if you say I am selling 45,000 rupees per SFT, that means you don't have intention to sell. Nobody will come, no bagra will come here. Correct na? That's solid. That's why price reasonably making sense. Yeah, it is a judgmental call. Agree. At the same time, next thing is what? Right? What is the efforts you have? Correct. What are the efforts? What are the efforts by the management? How it will become probable, my dear? Advertisement karna, broker ko bolo. Correct na? Something you must have started looking out. Correct na? At least you should have put something like basic thing though is held for sale karke. You must have kept some board here. Must have put an advertisement. Inform to brokers. Correct na? All that, are you putting all your efforts to do it? That is very important. Then next thing is what? You have to close this transaction within 12 months time. Agree? So if it is so, if it is that I can say I have clubbed all the conditions here. If it is so, then I can say yes, it is held for sale. You can classify it. Hope you understand. Right. Let's read this. It is committed. There is a committed plan to sell. That's what I told. Approvals, everything is ready. Right. and active program to find a buyer. That is what brokerage, advertisement and etc. What all supposed to be done, you did it. Right. And actively marketed for the sale and price is reasonable. Item also should be actively, that kind of item people are buying, selling. That is first point to be considered. And this is within 1 year, we said. And this is one more small concept, okay, which I didn't say, where there is a remote likelihood of taking it back. Withdrawal of the plan. I thought of selling, remote likelihood. I decided means decided. Extreme circumstance may it may happen ki I can step back. Stepping back is remote, rare chance. Then fine. Then you satisfied all the conditions, my dear. So since you satisfy all the conditions, then classification will take place. Okay, what will happen, my dear? Classification. What is classification? Non-current assets held for sale. Held for sale classification. Because of this, what will happen? Because of this, what will happen? First thing, on the balance sheet date. Correct, na? On the balance sheet. Where do you present? This is non-current asset, na? It will become current asset. Okay, current asset also where do you show? Below all the current assets. Normal current assets will come. Current investment, inventory, trade receivables, or okay, financial instruments wala it will come. Trade receivables or anything, loans and advances, cash and cash equivalent, other financial assets and other non-current, what is it, other than financial assets also it will come. Correct? Now they're down, okay, towards the end. I can say towards the end. Towards the end, it will be presented apparently on the face of, correct? Now where is this? It is on the face of balance sheet. Very important. Okay, presentation matters. Agree? Right. Next. This is one more beautiful and important thing you need to remember mandatorily. Okay. See, what is my date of classification? First thing, it can be any date. It not necessarily, this is not necessarily 31st March you should classify. Who told like that? It can happen any day. Sir, 30th 6 2025 I am doing the classification date. Correct? But already you measured it, correct? Now you measured at what, you measured at which date, till which date? You measured it on 31st March 2025. Already you have depreciated. Agree, na? Right. What you should do now? Before you come to 105, what did I say? Before you come to 105, first what is this? Sir, this is a property, plant and equipment. So 16 standard should be applied. Correct. Or sir, this is investment property. So 40 should be applied. It is intangible asset. So 38 should be applied. These are all non-current assets. And so first what are we supposed to do? Apply respective standard. Kya bola? Apply respective standard ko apply karo. Means what should I do, sir? Respective standard means you depreciate it. Correct na? Respective standard means depreciation. Depreciation for how many months? Depreciation for 3 months karo. Sir, I was following, correct na? I was following revaluation model. Okay. Yeah. Actually speaking, revaluation model, is it required? When do you apply revaluation model? 3 years to 5 years once karke I told just some time before. Agree na? And when you find like significant difference between the book value and the market value, then also you should do the revaluation, you should do it. If it is required to do revaluation, do it. But revaluation you are doing as per Ind AS 16 or 38 only. Agree? Right. Afterwards, then carrying amount is finalized. This is the finalized carrying amount. Depreciate it. If revaluation is necessary, as per the norms of Ind AS 16, as per the norms of Ind AS 38, then only you apply. Not like mandatorily you should apply. Sir, last year we did revaluation. Then why do you want to do revaluation once again? Not required. You got my point? As per the norms of respective standard. That's why we said before come to 105, go to respective standard. Follow the rules and regulations of that standard. Assuming it is not going to be held for sale. Aisa socho first. Okay. Then you come to my standard. Now what have you determined? Carrying amount you have determined. As per the respective standard, you determine the carrying amount. Now fair market value minus selling cost. SC, yes I will write SCS, selling cost. Okay, sir, my carrying amount is equal to some, okay, just some number I will keep it, some 1000 rupees I will keep. Fair market value minus selling cost. So that is equal to 800. Yes, what is it going to be measured? Whichever is lower. Correct na? So is there a loss? Yes, there is a loss of 200 rupees. E-loss, that should be transferred to profit and loss statement obviously. That loss should be transferred to profit and loss statement obviously. Should be hitting the P&L. Okay, right. One question I'll ask you. Right, it is not set by this standard Ind AS 105. You will see from top to bottom, you will not find this. Okay, it is somewhere else it is found. Suppose example, suppose if there is a PPE, okay, right, this is followed revaluation model. Okay, revaluation model I have followed, correct? And I have revaluation reserve exist in the balance sheet. Yes, it exists in the balance sheet, correct? Now I got a loss on this one, on classification. This 200 rupees what I am talking, I hope you understood. Now what should I do? 200 rupees, shall I hit the revaluation reserve or shall I hit P&L only? Question clear? Shall I repeat? You are following revaluation model. Whatever I told I have written here. Revaluation model you followed. You have a revaluation reserve in the balance sheet. You have balance. Okay, more than 200 it is there. Correct na? Now that asset is held for sale now. Correct? Right. Now when you see carrying amount minus FMV minus selling cost, you got a loss of 200 rupees. So, 200 rupees, do you need to hit revaluation reserve or do I need to hit P&L? It's only to P&L. It is not to, correct. All losses or profits to P&L only. Okay. Even though revaluation reserve is there. Got it? Both are meant for what? Sale only. Correct na? One more point, first and foremost point I missed out. When I say non-current assets held for sale, what do you mean by that? I want to get the recoverable amount is not by using it. Recoverable amount, I want to recover the value by selling it. That is the objective. Correct na? Whether it was revalued or not revalued, how does it matter? It is going to be sold tomorrow. Within 12 months, it is meant for sale, and you are very sure you are going to close it in 12 months only. Agreed? So that's why irrespective of all other category, it should hit profit and loss all the time. Clear? Right. So that is the first basic level of thing. Now, okay, sometime what happens? There is a word called disposal group. What is this? Disposal group. What is disposal group? It is in simple words to make you understand. It is group of assets. Okay. Or sir, I want a better term in CGU also you can tell. Cash generating unit as per Ind AS 36. Disposal group is nothing but both. Anything. Group of asset you say, or it may be CGU. Okay. Majorly it is a CGU. Fine. If there is a CGU is there, as per Ind AS 36, CGU can have goodwill. Yes. Maybe goodwill is directly allocated. Correct now. Goodwill is directly allocated to that item. That CGU ko goodwill is allocable. Correct. Goodwill can be allocated. Now, in this situation, what will happen? The only point, my dear, when I say disposal group, what will be there? There can be current assets. Correct. Na? Not necessarily you will have always non-current assets. Current assets and non-current assets also may be there. Agree? Right. Current assets, non-current assets, both are available. Hope you understand. Right. There can be non-current liability and current liability also may be there, because if it is a CGU, correct na? Yes, trade payables also may be there, other liabilities also may be there, everything may be there. Now the question here, even though all are applicable, all are existing in the disposal group, 105 is applicable only for this. Okay, Ind AS 105 is applicable, okay, applicable only for this. Yes, that is the crucial part. Sir, what about these items, sir? These items, sir. These items, what should I do? Even though it is meant for sale in a package, correct na? What are we supposed to do? You have to follow respective standard. Respective standard. Sir, current asset is there. Yes, you may be having inventory with you. Yes, inventory is there. You have to follow Ind AS number 2. Sir, I have a trade receivable. Yes, I have trade receivable. Ind AS 109 you are supposed to follow. Sir, I have investments. Yeah, I have investments. Maybe measured at FVTPL, maybe measured at FVTOCI. Correct na? Yes, it may be, my dear. Then also you need to follow Ind AS 109. Getting my point? Then only first, correct na? First, sir, should I apply my non-current assets first or this first? Generally, we'll apply the other assets will be measured at respective accounts and etc. Then we'll apply this one, non-current assets. Actually, whether you apply it together also, it will not be any impact. Difference will not be there. Choice is left to you. Okay, na? Right. So this is first and foremost thing. Okay. Next, sir, you got a loss. First, non-current assets, correct na? Non-current assets. Does it include goodwill or not? Non-current assets. Does it include goodwill or not? It includes. Non-current assets here basically property, plant and equipment, intangible asset, investment property, even goodwill also part and parcel. Okay, that's why if there is any loss, what are you supposed to do first? Yeah, first you have to hit goodwill to the extent available. You knock off whatever extent available. Then balance. So still there is a loss. Then what are you supposed to do? Proportionate to the remaining non-current assets. Other than not governed by, other than this, I mean to say, E items ko you should not touch. Correct na? What are you supposed to do? Proportionate. Proportionately allocate. Proportionate to carrying amount, I say. Proportionate to carrying amount, allocate the loss to other non-current assets. Is the concept clear first? Can we look at one sum so that you will get an idea? Correct? Right. Chalo. Now you see one sum. This, there is a, yeah. This is, I think this must be there from the textbook only. Doesn't matter. Okay. Concept capsule 4. Yeah. The following number are related to disposal group of entity. Right. Observe, my dear, goodwill is there. Correct na? So this is a non-current asset. Yes. Property, plant and equipment carried at revalued amount. Let it be. Non-current asset. Building is a non-current asset. These two are okay outside the 105. Agree? Inventory is 2 and this is equal to 109. Right. Carrying amount at the reporting date means balance sheet date before the classification as held for sale. Agree? Right. Next, carrying amount as remeasured immediately before the classification. Yes, I told na. Classification date is 30th/6. In my example here, correct na? Somewhere I wrote which day your classification I classified as 30th/6. But when did I measure it? 31st March में measure किया. Are you getting my point? Yes. So here two dates are given. Now question. Inventory before measurement. I mean maybe you can say like simple example में this is 31st March number, this is 30th/6 number to make you understand. Correct? Now what do I say? This was 2,400 my dear. Now I measured it. What is the cost star NRV? Which rule you followed? Cost star inventory ko cost star NRV rule only I will follow, not a new rule. Correct na? E 200 rupees. E 200 rupees ko what should I do? You will transfer it to profit and loss statement. Correct na? This is a loss of inventory. Always will be transferred to P&L. Now, what is this, my dear? Financial instrument 1800 that has become 1500. So that means is there a loss of 300 rupees? Yes. So where will this go? No, depends upon whether it is measured at FETPL or FETOCI. Correct na? If it is FETPL, it will go to P&L. FETOCI, it will go to correct. So that's why I cannot tell that answer directly straight away. See this 200 will be transferred to P&L. What about 300? Correct na? If the investment is measured at FETPL, it will hit the P&L. Otherwise, it will go to OCI. Is it clear? Correct. Now tell me, yes. Now tell me E numbers. Is there a difference or not? Yes, there is a difference. This is equal to 600. Correct na? It was a revalued amount. Now what do you do? Whatever the remeasurement, now you have followed which standard here? Ind AS 103 you must have followed. No, not 103, okay, 36 only you must have followed. Correct na? I mean impairment is supposed to be tested. So 36 you must have followed. Done. What about 4000? You must have depreciated. Correct na? What you must have done? You must have done the depreciation, right? One second. Yeah. So you must have depreciated. I hope you understood. Right. Or valuation loss something. Then that's why this may be hitting the profit and loss statement. Here it is 5700, 5700. So no problem here. Hello, understood? Now what is that you did in this step? You determined the carrying amount. Kya kiya? Carrying amount you determined. Hello, understood? Right. Have you followed here? Which standard you followed? You followed obviously Ind AS 16. Here also which standard you followed? Ind AS 16. But have you entered into 105 so far? No, not entered into 105. I hope you understood. First you are making what? Carrying amount. Once you make the carrying amount, next step will be carrying amount compared with fair market value minus selling cost. Is this clear first? Correct? Now you got. Next question may I will tell. What is that I will tell? The entire group wala, the entity estimated fair market value minus selling cost of the disposal group is equal to 13,000 karke I am telling now. Hello, understood? Whatever the losses, whatever the gains here, what is you have dealt it. Dealt is as per the respective standard. As per which standard? Respective standard prakara you have, I mean as per the respective standard you accounted for. Is this clear? Now come to what is the number it is you derived carrying amount? 14,900. Now fair market value minus selling cost is equal to how much? 13,000. So there is a loss of how much? 1900. 1900 mein first hit should go to 1500 goodwill khatam. Correct na? Then what is left now for what is left for you? 400 left. 400 should be allocated to what? Not to inventory and investments because it's already dealt by the respective standard. You shouldn't touch it. Correct na? E400 should be allocated between the PPE and the other two assets are there in the ratio of 4000 and 5700. Is this clear? That's all is the solution, my dear. Okay, yeah, first we will hit this number. Yeah, this has been 400 rupees divided between in the ratio of 4000 and 5700. Correct na? In 1900 if you, yeah, 4000 and 5700 ratio proportionate mein we have dealt it. Is the number pa. That's all. Okay, right. Next question. Concept capsule 6. Dekho. Continuation to the above concept capsule. At the end of the reporting, fair value, correct, balance sheet date. This is which date you did? 30th 6 you did. Correct. Which date you did? In my example dates only I am comparing. Okay, which date you have done, my dear? 30th 6 you did. Correct na? 31st March has come because still 1 year is not done. So not a problem for me. Or maybe my company is a listed company. Quarterly also will do presenting it. Hello, correct? Yes. So 31st March, 9 months only over na? Hello, correct? Now in between, now again I am supposed to measure the carrying amount or the fair market value minus selling cost. How much is the number? 15,000, correct? 13,000, not this number. 15,500. Is it gone up or down? Up. Up. Not a problem. Up is also not a problem. Loss is also not a problem. So now what should I do? I can withdraw E2 numbers. Correct. Goodwill can you withdraw? No, it has gone up, but I can't help. I can bring back only maximum 400. Correct? Yeah? Not beyond the 400. Hope you understood. Next, one more point. You make a note. The building or property, plant and equipment. Once it is classified, no depreciation. Have you noted already? Yeah, if not noted, note it now. Once classified, okay, once classified as held for sale, once classified as held for sale, no more depreciation. You are not supposed to depreciate anything. That's it. Only every year, that's what do you do? Only every year, carrying amount or FMV minus selling cost, whichever is lower, our number only transferred to profit and loss statement. It's always like that. Hope you have understood that point. Right? Any questions so far? Done? Right. Goodwill can never be taken back, because goodwill take back means it leads to internal generation of goodwill recognition, it will be, which is prohibited. Correct? Na? That's why we will not take that back. Fine. So this is first, once classified. Right. One more concept is there. One more, suppose you have withdrawn the plan. What is done? You have withdrawn the plan. Correct? You have withdrawn the plan. What is the plan? Your plan is to sell. Now you decided not to sell. Correct? Now you wanted to, correct? Now you want to continue to use it. Now under the circumstance, what are we supposed to do? What number ko we should bring? Same, this concept is like same, like I will say same like Ind AS 36. Anyhow, we will discuss the 36. E point I will not discuss once again, because I am discussing now here. Correct? Na? Right. What is that you should do, my dear? In this case, same like 36 means, if I had not, see now for last 2 years, last 1 year example, have you depreciated? You have not depreciated. Suppose if it was never classified as, held for sale, what would have been the number? Correct? Now what do you say? If the asset was not or never classified as held for sale, a carrying amount, you should keep that number. Okay? Recoverable amount. Recoverable amount as per 36. Recoverable amount is nothing but value in use or FMV minus. Now value in use will work. Why? Because you want to take back means you don't want to sell it. You don't want to sell it means you want to use it. Correct? Na? Value in use or FMV minus selling cost, whichever is higher. Correct? Na? Some number will come, whichever is lower. You should bring it to this number. I hope you understood. Maximum you should bring it to E number. Right? So that means what? In the here, what is that you are doing? If it was never classified as held for sale, you would have depreciated or you would have revalued, whatever it is, as per your existing policy. Do that. What would have become my number? A number, you keep it. And what is the recoverable amount? Whichever is lower only, that you can bring it. Right? So my carrying amount is 1000. Now correct an example. Say my existing carrying amount is equal to 1000. That is after applying the 105. After I am applying 105, I brought it to 1000 rupees. Now it will become say 1200. Now recoverable amount may be 1800. Are you getting my point? So now what is the balance, my dear? 1200 is the lower. So you can improvise 2 plus 200, you can say. Correct? Na? Right. 1200 tak maximum you can bring it. Recoverable amount may be much more. That we cannot do anything more on that. Is that clear? Right. This is for, I mean, most of the important points of the standard has been covered. Only discontinuing operation, one small point, I will cover it in maybe another 5-10 minutes. We will cover. Okay, right. Listen, my dear. Here always the question will come: is it a disposal group or is it a discontinuing operation? Okay, right. The standard is non-current asset. Non-current asset is non-current asset held for sale. Okay, say example, one subsidiary is there. There is a subsidiary. If subsidiary is held for sale, what do I say? Subsidiary is held for sale. Getting my point? Subsidiary is held for sale means, subsidiary means it has one business, basically. Agree? Right. Will that first subsidiary is held for sale? Yes. Question is it a discontinuing operation? When do you say it is a discontinuing operation? When it can be called as that is one separate line of business, geographical business or a business segment, whatever that words are not there in the standards, but yes, just for understanding. Is the subsidiary a separate line of business? It can be, it may not be. Both are possible. First, what is it? Is it separate line of business? Okay. Yeah. Answer can be yes. Answer can be no. Means what? Okay. Means what? Example. What is my holding company? Sir, holding company is into hotel business, sir. Done, not a problem. Sir, what is subsidiary company? Subsidiary company can be hotel business. Subsidiary company may be manufacturing business. Agree? Right. Right. Now simple question. Now if I sell, situation number 1, if I sell the hotel, S company I am selling, it is into hotel business. Is it a separate line of business? No, it is in line with the parent company business. Agree or not? Are you out with the business? No, your group is still dealing with the same business or not? If it is hotel, correct na, then it will be called group of assets or disposal group I will call. What do I call? Disposal group. It will not be considered as subsidiary you are selling, but doesn't mean that it is a discontinuing operation. Why discontinuing operation? You are still in the line of business. Are you hotel business or not? Yes. Correct na? Now, so that means only disposal group of asset. Okay, just group of assets I am selling. That's all is the concept it will come. Group of assets I am selling, but not right. But not the what do you call? Discontinuing operation का problem नहीं आता. Right. No sir, it's a manufacturing business. It's a separate line, sir, from the parent and other group of entities. It's a separate line of business. My group was dealing with manufacturing earlier. Now I am not dealing with manufacturing of soap. Okay. Now it is discontinuing operation. Now it is discontinuing operation. Is that clear to you? Hope you understood. That is more important. Sir, if it is discontinuing operation, what will happen? Then disclosure will come, correct? Now, presentation and disclosure. Yes, what will happen? Presentation and disclosure. In the P&L also, P&L also will come. P&L will come plus balance sheet anyhow will come. With respect to assets, separate line item below the current assets, presentation will take place. If it is a disposal group, what will happen? Disposal group only balance sheet में presentation. Yeah, only balance sheet में presentation will happen. Nothing else will happen. P&L में do you touch? No, will not touch in the P&L. Will not touch the P&L. Clear? Now listen carefully. Okay, if it is a discontinuing operation, I told na what you are discontinuing, it should be separate line of business. Okay, if it is I am into same line of business, no, it is disposal group, we will call it. Now what are you supposed to do? Current year, previous year. First, previous year, if it is discontinuing operation, the previous year number should be restated. Why restated? Listen, now the profit and loss, what will happen? Income, expenditure, correct na? Profit after tax or after tax, okay, from continuing operation it will come, correct? Which segment you wanted to sell? One segment will be there, a segment, okay. So profit or loss from the discontinuing operation, only one line will come here, only one number will come here. Again, plus or minus tax impact on discontinuing operation, tax impact will come. Okay, this will become B and your profit, this is going to be A, this is A plus B. In OCA also we will write the same thing. In OCA also, any OCA element arising from the discontinuing operation, we have to record it separately. We have to record it separately. Have you understood my point? Suppose you have a business A plus B plus C. C is going to be discontinued. Correct now. Then what do you do? In the top, what will come? What will come, my dear? A plus B ka information will come. E2 numbers are related to C. Now restatement may, because you are now, earlier last year it was not decided to sell. Now you are deciding to sell. Correct na? So last year it was actually A plus B plus C. Now you have to cut C. Again you have to bring the C related information. Restatement will happen in the P&L. In the P&L also, in the P&L you have to write separately. You have to write like that. Are you understanding this point? That is the crucial crux of presentation if it is a discontinuing operation. Here calculations are nothing. Next, one more concept I will tell. Okay, right. Sir, you wanted to sell the subsidiary. Agree. You want to sell the subsidiary. Subsidiary ka what is the profit or loss? Profit or loss, I mean E number I am talking. Okay. Profit or loss includes what, my dear? Suppose it is sold. Assume sold. Assume sold out in the current year. Current year is sold out. Currently sold which date, sir? Say 30th 9 2025 I sold it out. You are in which financial year? You are in 2025-26 financial year. Agree na? What will be the number here? E number, X number, XX number, which I wrote it in red color. Correct na? This number, the color includes. Okay, that is includes what? The transactions from April to September. Correct na? April to September. You have done the business na? All the sales minus purchases, all that will come. Plus, correct na, profit or loss on sale of subsidiary. E number also will be part and parcel of down only. You understood my point? What is that you understood? Tell me. When have you sold? Completion of sale when happened? When is it happened? 30th September. So the discontinuing operation, you must have done the normal buying, selling goods, etc. for the 6 months or not? You will continue business till the last date. You will continue business. So all the sales during 9 months minus expenses, profit, whatever profit or loss arising from the operations, it will come. Plus, have you sold the asset? Have you sold the subsidiary? Have you sold the subsidiary? By selling the subsidiary, do you get profit or loss? You will get any one number will come na. Number, that number also is going to be part and parcel of under below line item only. Below, I mean after PAT, where I show separately. That is not just only operational profits or losses. That includes the profit or loss on sale also. Clear? That also is going to be presented over there. Hope you understood. Done. So we are done with Ind AS 105. Okay. Yeah. Take a break and come back. We'll look at Ind AS 36. Yeah. Let's get into Ind AS 36. That is impairment of assets. Okay. Right. This impairment of assets, this standard does not deal with the impairment of financial instruments, because impairment of financial instruments dealt by which standard? 109 only deals with it. It has its own paras. Okay, right. So this does not deal with obviously AS2. I mean, Ind AS2 means inventory ka not required impairment, because always cost or NRV, whichever is lower, every year you are going to test it. Then why impairment separately? Correct, na? Right. So again you write like here, it does not deal with. Does not deal with what? Does not deal with impairment of financial instruments. Financial asset basically. Financial asset impairment, no. Why? Because it will be dealt by Ind AS 109. Yes, Ind AS 109 deals with the impairment of financial instruments. That is what ECL and etc. will come there. Okay, yeah. So, impairment of assets means basically which standard, which assets are we dealing here? Which assets do you deal means only that is actually PPE, okay, intangible assets and investment property. These are the major assets which are going to be tested on this under this standard. Current assets does not require this one, correct? Next, the next item after this, what is there? Impairment, sorry, financial instruments. Financial instruments, I said separate standard is there for that, correct? Na? So other non-current assets and etc. not required an impairment separately. Fine, right? So these are the items which are going to be tested for impairment. Next, Ind AS 36, right? In general, as I already told, we should test for impairment not every year, only when there is an indicator, except 1, 2, 3 circumstances we give, right? So in general, correct na? In general, test for impairment, correct na? In general, test for impairment, yeah, only when there is, correct, only when there is an indicator, only there is indicator. Yes, these indicator can be, as you know, internal indicator, correct, and external indicator, but anyhow it is an indicator. Okay, it may be internal or it may be external, but you got an indication saying that asset carrying amount is greater than recoverable amount, correct. Now when do you say impairment loss exist? Impairment loss exist when do you say? When you say carrying amount is greater than recoverable amount, agree? Recoverable amount is lower, carrying amount is higher, then you have an impairment loss that should be charged to P&L, correct? Yeah. And what is recoverable amount, my dear? What is a recoverable amount? That is nothing but value in use or FMV minus selling cost, correct now, whichever is higher, right? Value in use or FMV minus selling cost, whichever is higher is the number. Okay, so far they have never asked you to calculate what is value in use, what is FMV minus selling cost. These numbers are straight away given by them. Okay, if you see all the questions all these years, whatever they have asked, no, right, how to test, not required to look at. Fine. So but anyhow, just simple straight, I mean 1 line 2 lines, may I'll try to close it. What is value in use, my dear? Value in use nothing but present value of future cash flows, future obviously estimated cash flows, yeah, by using the asset plus terminal value. Terminal value in the sense at the end of usage you will be selling that, correct? No? Not today, that is at the end of the life terminal. Suppose the life of the asset is 10 years, so at the end of the 10th year if you sell, what do you get? A number also will take it, that number you will bring it to present value. Our present value is called value in use. Okay, when I say present value, okay, present value means which rate, what is the rate of discounting you should apply? IRR of what? IRR of the specific business basically. Okay, what are you supposed to do? IRR of the business. Okay, IRR of business. Business means a specific business, especially for which business these assets are being utilized. Okay, if you know, then the first priority will go to this. Is if you have available, this is the first and best priority. Got it? Right. So that is not available. That is not available means then incremental borrowing rate is okay. Then incremental borrowing rate. Okay, or the other best way is equal to what? WCC, weighted average cost of capital. Weighted average cost of capital. Something, this thing can be anything. I mean, out of this first priority 1, 2, 3, something like that. Weighted average cost of capital can be utilized. But specifically they say in case of weighted average cost of capital, you need cost of equity, cost of debt, etc. The cost of equity, then you are supposed to CAPM model. You are supposed to apply capital asset pricing model. Correct now, you know RF plus beta into RM minus RF, something you learnt in, correct, FM, whatever, somewhere you learnt, correct now. So that model only for KE you should apply CAPM model, karke that sentence is there. Next, you have, correct now, if you have impairment loss, then what do you do? If it is an individual asset, first initially we will go with individual asset. You have impairment loss. What is that we are supposed to do, my dear? You should charge it to P&L, no? Correct. But first you should ask a question, was it, correct now, was it revalued? Was it revalued in the past? Okay, and revaluation reserve exists. Correct. If you say yes, if you say yes, then what are you supposed to do? Debit revaluation reserve to the extent available. To the extent available. Yes. Generally, first debit will go to revaluation reserve. Okay. Then balance, if there is any balance, that will hit the profit and loss statement. If it was revalued asset is impaired and revaluation reserve exists, hit revaluation reserve. And is still more than the revaluation reserve, there is an impairment, then it should be transferred to profit and loss. There is no revaluation reserve or it was never revalued, correct na, any one of the circumstance, this you are supposed to charge it to P&L. Supposed to charge it to P&L. Correct na? Right. Always what will happen, my dear? What will happen here? Either revaluation reserve account to debit, correct na? P&L impairment loss account, yes, obviously impairment loss account to debit, correct na, to accumulated impairment loss. It will be accumulated impairment loss, like accumulated depreciation, will transfer it to accumulated impairment loss account ko we will transfer. Agree? Right? Next. Yeah. Here suppose my expected cash flows are, correct na, suppose cash flows are in what? Cash flows are in foreign currency. Cash flows are in foreign currency. Now what are you supposed to do? Which date rate you should take it? You understood my point? I have a branch or a fixed asset is outside in India. Whatever the cash flows will come, those cash flows are dollars may it will come. Okay, so dollar first year, I mean next year dollar X 100 rupees will come, $100 will come, 200 will come, 300 will come, 1, 2, 3, 4 years I have done. Correct. Now for that you have to convert into rupees na, because numbers are in rupees. My functional currency is rupee. Hello, correct? Now what should I do? You should use which rate? Rate and the balance sheet date only, ma. Why are you thinking so much? Rate and the balance sheet date. Okay, you are not supposed to take the projected. You are not supposed to take what? Projected forex rates. Okay, you are not supposed to take projected forex rates. You have to take the rate and the balance sheet date. Just use that rate, convert it, and close it. Okay, na? Agree? Suppose Indian is the parent company. Indian is the parent company. Subsidiary is US entity. Correct? Now, asset is related to subsidiary. So, the cash flows are in dollars. Correct? So, what do you say? One number, correct? Na? Right. So, something like this it is there. So, once the first year, second year, third year, fourth year, something like that I kept. Correct. So, now when I say what is the rate, present value factor I am supposed to apply. Present value factor I am supposed to apply. Correct. Na? Who is preparing? Indian parent company is preparing the consolidated financial statements. Correct. Na? CFS, consolidated financial statements you are applying. Okay. Right. Say example, we are going by the borrowing rate. Are we going by the IRR? Right. The IRR of this parent company is equal to say 10%. Subsidiary company is equal to 9%. Now, which rate I should discount it? If they give both the data, na, then the question will come to your mind. Otherwise, question only will not come. Correct. Now, two rates if they give, then thinking starts. What do you say? 10% or 9%? Average 9.5. Better. Yeah. What do you do? Huh? Hmm. No way. It should be only 9%, not 10%. Why means that is the, see, asset is where? US. Correct. Na? So, whatever the IRR of that asset or IRR of the business of subsidiaries only you should consider, not the parent company. Okay, right. Because tomorrow they do business also, the rate of return expected is equal to 9% only. You should not consider, even though it is for the consolidation purpose, whatever the number valued, a number is correct. Other number only, same number only supposed to come to consolidation number as it is. No recomputation will happen here. No recomputation, correct? Now you can write in CFS, no recomputation. No recomputation in this regard. Right? Will not do any recomputation. That same number, whatever the subsidiary company has done, will keep it as it is. Okay. Next concept is straight away CGU. Fine. Cash generating unit. Correct. This is the smallest group of identifiable assets and liabilities, everything group. Correct. Now, which is generating independently. It is generating independent cash flows from other group of assets. CGU stands for smallest group. Okay, right. Anyhow, the questions are smallest group in the sense your business is so big. Correct. First, you should start with the smallest group. Okay, can we generate independent cash flows? Okay, yes, we can generate independent cash. Independent means what? My cash flows are not depending upon the next group of assets. Got it? Yes. Then this is a CGU. Like that, one entity may have many CGUs, or sometime what happens, they may not have any CGU. The entire entity is equal to one CGU also possible. It depends upon the situation that management has to assess exactly. I hope you got it. Right. In case of CGU, what can happen? In case of CGU, what can happen? First and foremost thing, goodwill, I'll keep it separately. Assume there is no goodwill right now. Correct na? So there will be number of assets in the CGU. Yes or no? It is not only one asset. It is multiple number of assets. Correct na? So there are number of assets. Number of assets are there. Under that circumstance, what are you supposed to do? You got an impairment loss. Got it? Like say you have asset 1, 2, so 100 tak you have got assets. So yes, total carrying amount is equal to say 1000 crores karke total carrying amount. This is CA. But what about the recoverable amount? Recoverable amount is equal to 900 CR only. Okay na? So that means there is an impairment loss of 100 CR is there. Right. What should I do with this 100 CR? Shall I allocate it to all the assets or shall I keep it as only one line item? Question clear? Huh? Shall I go and allocate it to each line item of 100 assets are there? Correct? No? One big factory hai to so many assets will be there, not 1 to 3 assets. What should I do? No, you have to allocate it. You must allocate. This is not this is mandatory. Why I'll tell. You must allocate to all assets in CGU in the ratio of carrying amounts. You must allocate. Why should allocate, sir? Why should allocate means if you don't allocate, na, what will be the next year depreciation? correct na? If you don't allocate, suppose there is 1 lakh rupees, one asset is there, impairment loss may come to some say 1000 rupees impairment loss will come, correct na? What is the now revised number is equal to 99,000. 99,000 rupees should be depreciated prospectively over the remaining life. So, because of impairment loss, what will happen? Impairment loss will have impact, correct? It will have impact on depreciation of next year, not in the current year. Okay, because as I already told you, first we will do current year depreciation, then only revaluation, then only impairment loss. Sometime before I told you, correct? Na sequence में first depreciation will do. If revaluation applicable, we will do revaluation. Then only impairment loss testing will be done. So current year depreciation is already done. What will happen to next year depreciation? Next year depreciation is old carrying amount minus impairment loss. That amount is going to be depreciated over the remaining life of the asset prospectively. Understood? So that's why, right? Correct na? 1 to 100 assets may, all assets life may not be same. Correct na? All assets depreciation method also not necessarily be same. Maybe same, may not be same. It is possible. Correct na? Right? So that's why you have to allocate it. You don't have a choice. Excel में करना पड़ेगा. You should have one more column called impairment loss, like how you have current year depreciation, previous year depreciation, accumulated depreciation, like that impairment loss one column you should have, and allocate the numbers, should do it. But in this allocation, okay, okay, when you are allocating this, you may be aware, yeah, when you do allocation, correct, one important point, then we'll go to goodwill immediately. Okay, when you are doing the allocation, say example, there are 1, 2, 3 assets are there. Okay, say example carrying amount. What is the carrying amount? Simple example के लिए I will take like 1000, 2000, 3000. I will take it. Total is equal to 6000 carrying amount. Okay, so this is the total carrying amount. What about the recoverable amount? Say recoverable amount is equal to 4000. Agree? Right. So there is an impairment loss of 2000. Normally what should I do, ma? The 2000 will be in the ratio of 1:2:3. Correct na? Can you use calculator? Yeah, impairment loss. I think 333 will come, correct no? 333, 667, and this will be 1000 rupees. Okay, right. So that is equal to 2000 rupees. Agree? Right. So after carrying amount, what is the balancing number? Balancing number is equal to 667, 1033. This is equal to 2000 rupees. Agree na? That is equal to 4000. Now, one question should come to mind. Okay, they have not tested this concept, still pending. Fine. Yeah. Now the question is, example, the third item ko how much you allocated? 1000 rupees you allocated. That's why the carrying amount has become how much? 2000. But actually, if I say my NRV, net realizable value, or FMV minus selling cost of the only this asset, it is not a group of asset I am talking. Only asset, can I sell it in the market or not? Asset you can sell it. Sir, if I sell that asset, now 2200 will come, sir. You understood my point? If I sell the asset, I will get how much? Then, but you, what is your concept of impairment loss? You brought it to 2000 rupees. Agree? How is this correct? Is it correct? You understood my point? Obviously not correct. Hello, got it? That means what? After impairment, that's why after impairment loss allocation, okay, carrying amount should not be below the what? Below the fair market value minus selling cost. Are you getting my point? Below the fair market value minus selling cost ko nahi aana. It is not correct. Okay, second point, VIU, value in use. Value in use in my example not possible. One more example may, when I explain goodwill concept, when I explain there, that a word usefulness is there. Third, it should not be below 0. You cannot bring it to minus number. Na? You allocated something, so I brought it to minus number. It is not possible. Maximum impairment loss you can make asset value is equal to 0. Hello, correct? Huh? Yeah, you should not make it, you should, carrying amount should not be below fair market value, right? Now, in this situation, what should I do now then? Add back in the sense, you will say here minus 200 you should do, correct? Na? So, minus 100 you do means E200 again, E200 should be allocated between these two. Remaining assets को allocate करो. Hello, understood? No sir, ये asset को भी ऐसा हो गया. That means there is a problem with this asset only. Correct ना? So the more loss should go to that asset. Why are you allocating first asset का loss to third asset and second asset? Only NRV na, but value in use you cannot derive, the independent cash flows are not there. That's why value in use cannot be determined for asset number 3 to 1 separately. That's where CGU concept came in, correct na? So NRV can be calculated, but not the value in use. Understood? Right. That's why you, right, after doing this, what I am trying to tell, after doing the impairment loss, your number should not be coming below the NRV. NRV is FMV minus selling cost, in simple words I told. But in exam, FMV minus selling cost you should apply. Okay, if I am correcting the paper, I will not give mark if you write NRV. I am telling you seriously. FMV minus selling cost is FMV minus selling cost, NRV is NRV. Okay, both are not one. And NRV is specific to that asset. There can be agreement. Okay, but FMV is market oriented. FMV is market oriented. Anybody at what rate you will buy. Okay, so there is a difference. That's why you should not replace the words. That's why except Ind AS 2, everywhere FMV minus selling cost a word used. Nowhere they use the NRV language. Hope you understand. That's why you also, except for inventory, all other places, blind rule you follow FMV minus selling cost. Okay, na? Can I go ahead? This is the one important point. Even after you do the impairment loss allocation, okay, right, carrying amount, fine. If someone wants to test, they can frame a question just like that. They can frame a question. Just a matter of few minutes. Got it? So that concept is, I told, so far not tested. I mean, concept only not provided in the textbook also. Only sentences are there, but it was not given as a question and answer. They have not provided. Okay, right. Next, let's enter into the concept of goodwill. First thing, when I say goodwill, shall I? Yeah. When I say goodwill, goodwill arises from where? Arises from the business combination. Correct. On acquisition of a business should be acquired, then goodwill will come into the picture. Agree na? Correct. So when the business is acquired, goodwill will come. That's what understood. But when I have, correct na? See, there is acquiring company, purchasing company, I'll write PC for purchasing company. Okay, selling company, that is the business which you purchased. You bought the company. So entirely it will come. Now the question, purchasing company has CGU A plus B plus C are there. Okay, selling company has CGU D plus E is there. Okay, right. On acquiring this, I paid goodwill. Of 1000 rupees. Excess payment is done. Correct. Now, first thing, 1000 rupees should be correct because you bought D and E together, considered as selling company. Company you acquired. That has two businesses or two CGUs. It has there. D and E is there. Correct na? So now first question number 1. What should I do? Should I allocate? Now goodwill has come. Goodwill should be allocated to which CGUs? A plus B plus C na, D plus E na, for all any combination. Can you tell? So what's your answer? Don't know. Standard says first it should be going to A plus B plus C. Or if you know specifically for A, specifically for B, specifically for C, you should go to specifically to A, B, C only. I mean, whichever, A or B or C. Not necessarily A plus B plus C. Okay. Strictly speaking, a D plus E only not allowed. Or other way around, this is not exactly right way, but okay, but allowed. Allowed, no doubt. Both put together. A plus B plus C plus D plus E. Okay, but first priority A plus B plus C. A or B or C or any combination may you can do it. Why? Why means first of all, how do you calculate goodwill? The fair market value of the consideration, correct? Na? How much you gave the consideration? Fair market value of consideration you have taken. My plus NCA ka assume 100% you have acquired. No NCA is there. So minus fair market value of the net identifiable assets. Correct? Na? At fair market value you have taken. Are you getting my point? Say example, you are paying 4,000, identifiable assets ka 3,000 rupees is there, right? So E assets fair market value, market rate, if I take it and purchase also, it will cost me how much? 3,000, but I paid how much? 4,000. Why you paid 4,000 excess? 1,000 excess you paid. Why? A goodwill correct, but why did you pay? See, nobody will pay just like that. Correct. Na? If you say you are selling one mobile, what is the market value of the mobile? Say example 10,000. I will pay 10,000. If you say 11,000, then I will say buy. Why should I buy? Agree or not? So like that. So D plus E ka total fair market value is equal to 3,000. But I paid 4,000. I paid 4,000 means 1,000 excess I have given. Why? More value to the existing business, not to the what they are giving. What they are giving, I am already measuring it at market value. If I buy D plus E, that may be impacting, say example, my B business, it will be correct. Now B, we can become monopoly now. You understood my point? Right. So my market share will be more. Now I will be the leader. I hope you understand. So it is going to give value to the existing business. Value will be increasing to which? To the existing business. That's why I am ready to pay. That's why I am ready to pay. I hope you understood. That is the synergy benefit I am going to get. That's why we'll say that this is already I have brought it to the fair market value. Why should I allocate it to that? No, this is going, I paid excess. I am okay to pay excess because this will add my value to my existing business. That's why. So first priority should go to A plus B plus C ko. First priority they go. Okay, right. So which if you know, like no, A ko only I know clearly. Understood? Or B only is going to get the benefit. Then directly allocate it to B. Right. Sometime what is the situation number 1? Can we allocate? Question we should ask. Can we allocate it to A or B or C or any combination? Yeah. Are you getting my point? Can we allocate it? First you should ask yourself. Yes, I can. Answer can be what? Yes. No. Correct. Na? If you say yes, answer can be yes, answer can be no. If you say I can allocate it, means allocate it. Which ratio? Which ratio actually you should say, I think A and B ko benefit will be more, so that's why I wanted to allocate it to A and B. Fine, excellent. 1,000 rupees in which ratio you wanted to allocate? Next question should come. Correct na? In which ratio they are getting more benefit, that ratio you should do it. It may be 2:1 or 4, whatever the number 1:1. That's up to you. Are you getting my point? A is going to get more benefit because of this acquisition. So A ko out of 1,000 more money should be allocated to A. B will get comparatively less. So lesser amount should be allocated to B. Why is it relevant for me? It's relevant for you. Why relevant for you? I'll tell you. If you allocate it, no, my dear, correct na. Now that goodwill should be tested impairment, correct na. Tested impairment loss every year. Mandatorily. Okay. If it is not allocated, na, It is not allocated specifically. ಗೊತ್ತಿಲ್ಲ ನನಗೆ. Is it A is getting benefit, B is getting benefit, C is getting benefit? I don't know. How much is getting benefit? I don't know. But I know overall my company will get benefit. I hope you understood. Then yes. Then do not allocate. Correct? No, do not allocate. That is welcome. Not a problem. Correct? No. Now only when indicator exists. Only when indicator exists. So impairment test of the acquired goodwill, if it is allocated to any CGU, then only it is going to be tested for impairment every year. Otherwise, right, whatever I told you earlier rule is overall rule. When you get into deeper, then you will get to know perfect sentence. Okay. If it is not allocated, that time it is not required to test the impairment of goodwill every year, but only when there is a, what is that? Test, I mean indication exists. If there is indication exists, then you are supposed to do it, otherwise not required. Is it clear now? Okay. Now listen. Now what is that E situation mein what has happened? A, B, correct na? A, B ko what did you say? Your assets value. Sir, assets value, already existing assets value 4,000, 5,000. Now goodwill. Goodwill is equal to here 500, here also 500. Equally I have done. Okay na? 4,500, 5,500. Correct? I hope you understood. Now, now every year are you supposed to test for impairment loss? Yes, you should test for impairment loss every year. Correct na? So recoverable amount every year as usual. Now what will happen, my dear? You are able to allocate na? That is part of the asset. Hope you understood. Part of the asset recoverable amount is equal to say 3,900 rupees. So there is an impairment loss of 600 rupees. 600 rupees mein first what are you supposed to target? Goodwill will be targeted. Correct na? Goodwill will be 500 rupees. Then 100 rupees is allocated to other assets. Other assets in the ratio of carrying amount. In the ratio of carrying amount mein you are supposed to do this. Is this clear? Correct? Right. This same thing, A ko what will happen? B also it will happen in the same fashion. If it is allocated, this is the procedure which you should follow. Any question? Can I go ahead? Perfect. Now come to the second situation. Second situation mein what is happening, my dear? A plus B plus D plus E all are there, plus goodwill, because you are not able to allocate. Correct now? What did I say here? Not able to. Correct now? You are not able to allocate. Yeah, because of the excess payment, which CGU got benefited? God knows. I don't know. Hope you understood. Which CGU got benefited? I am not sure. That is the reason E situation comes in. Now in this case, what should I do, sir? In this case, what you should do? First question number 1, current year. Okay, right. Is there any indicator for impairment loss of A or B or C or D or E? Any one of the 5? Correct now. First question, is there any indication? Is there any indication? Indication of what? Indication of impairment loss of any CGU. First question you should ask. Do you have any impairment loss of any CGU ko impairment loss do you have? Correct na? Suppose answer is no. Okay, test next year, that's all. Test next year, that's all. Correct na? You don't need to bother about it for the current year. Yes. Then which one, sir? I got doubt on B. I got indication on B. Correct now? What is the question? What is the question, guys? Is there any indication of impairment loss of any CGU? I am asking. What is the answer has come? Yes, we have got a doubt on the B. Correct? So now what should I do? Where are we right now? Where goodwill is not allocated. Goodwill is not allocated. Under that circumstance, first thing, B ko doubt hai na? First test for correct na, test only B. Okay, only B means what? Without goodwill. This is step number 1. Test impairment loss only for B alone. No, don't consider the goodwill. Are you catching my point? Do not consider the goodwill, just B alone, check it. Example, sir, B carrying amount. B carrying amount is equal to how much? 1000. Okay. What about the recoverable amount? Recoverable amount is equal to 900. Yes. So there is an impairment loss of 100. E100 should be allocated to the carrying amount of the all assets in the ratio of the carrying amounts of B assets matra, only B asset. Are you following me? Right, done? Not done. Step number 2 is there. Step number 2, this is the problem now. Practical issue. Okay, what are you supposed to do now? Now you should take carrying amount of A plus B plus C plus D plus E plus goodwill entity as a whole plus recoverable amount of entity as a whole. Getting my point? Right. Now if there is any now suppose if there is an impairment loss of XX number is there. Now this impairment loss will be adjusted with, correct, now impairment loss first with goodwill. This is the concept of goodwill ka concept. So if it is not allocated to a specific CGU, okay, don't allocate, but I know it is pertaining to some CGUs. Okay, but in this case, you don't need to test for impairment of goodwill on every day by day basis, not required, correct now. But you are supposed to, what are you supposed to do? If you get an indicator for one item, first item alone independently you should test. If there is any impairment loss, don't give it to goodwill. You allocate it to that CGU ka assets को allocate करो. Okay, allocate कर दिया. But not, I mean, correct. Afterwards, that's all. Not, you should not stop there. Second level mein what should I do? Now overall test for impairment should take place. That's why A plus B plus C plus E plus everything together plus goodwill. At what level goodwill is allocated? Sometime it can happen. D plus E ko I don't want to allocate. I want to say A plus B plus C plus goodwill I can say. That time A plus B plus C plus goodwill only you take it. Goodwill is related to A plus B plus C, but not allocated to A plus B plus C. Kya sentence? What did I say? Goodwill is related to, not allocated to. Goodwill is related to A plus B plus C, but not allocated. Allocation means cut and give. If I say one apple is there, you 3 people are there. Allocation means what? Cut, piece. There though. Hello, understood? He will keep his piece in his pocket, you will keep your pocket. But here different situation. That is first category is already done. Correct. Now second category mein what is there? One apple is there here, it is related to ABC. Correct. Now, am I cutting the apple? No, I am not cutting. Apple is apple only still now. Hello, understood? I am keeping the apple, but it is related to whom? Not to everybody here. The apple is related to 1, 2, 3 ABC items only. This is the scenario. Under that circumstance, if you find any indicator with B impairment, test for B impairment, and if there is an impairment loss, so give the impairment loss to the carrying amounts of the B alone. Plus the second round of checking also should take place. Now that time it is related to ABC when I told in my new example. In the example what I have written, it is related to A plus B plus C plus ED. A to D, A to E I told. In my next example I am telling A plus B plus C only. Yes, then you should test A plus B plus C plus goodwill, check once and do it. Hope you understood that point, right? That is with respect to goodwill, my dear. Okay, right. corporate assets करके one more concept is there. What is that? Corporate asset. Corporate. Hmm. It depends upon. That's why the first question should be here. Question is here itself. Hmm. First, your answer is based on it can turn into one way. You can tell. First situation is I can allocate it to A plus B plus C. You can tell, or I can allocate it to allocation. Okay. I can say allocation is for A, B only, or I want to allocate it only to A or only to B, only to C. Agree? It can happen. Or second situation, I cannot allocate it. I can't cut and give the pieces into like this. It's very difficult for me. Practically not possible. Assume kiya to, then at least tell me, E goodwill means excess paid. Because of this, which businesses have got benefited? You don't know how much benefit, but I know which got benefited. Which got benefited? Tell me. It can be A, B, C. It can be A plus B plus C plus D plus E. Got it, na? If your answer is all entire company ko got benefit because of the excess, then I will say goodwill is related to entire company, but I am not allocating to each one. You understood? So first mein what is your answer? Accordingly, my next question will be there. If it is the word if you use allocated, you are under first category. Allocation means what I told, apple को cut करना, cut करके देना. That time correct, D and E as because D and E it's already measured at fair market value. Because it is part of acquisition, D and E is already measured at fair market value. Then why should I? Correct na? What is the point? I don't need to do it. Okay, so first may at the time of acquisition of goodwill only you should have done this basic exercise. Fine, right? Whether companies are really doing practically, big doubt, significant doubt on this. Impairment standard ko impaired, they have impaired only already, right? It's okay, but corporate asset. Corporate asset means what? There is no value in use. You can't determine value in use. Okay, corporate building is there. Corporate building say what is the use? No future economic benefit. Correct. Now what do you do? Corporate building may all corporate employees will be sitting. That is a cost center. That is not a revenue center. I hope you understood. Okay, here it is no value in use. First concept I can say. Suppose my research center is there. Research center is what? Cost only spent there. Correct now. Income will come, will not come, that God knows. Because even income comes, research center will not go and produce it. Knowledge will be given to any of the CGUs. That CGU will produce the goods and give you the money. Understood? So these are all cost centers in simple words, not revenue centers. Agreed? Now what should I do? That is also end of the day PPE. Correct na? So that also may undergo for impairment. So here also what are we supposed to do? First you should ask question. Can we allocate? Can we allocate to any of the CGU of company on reasonable basis? Some logical basis में can we allocate it? Question mark. Suppose this building is there, sir. Okay. How many floors? 1, 2, 3 floors. How many CGUs you have? I have ABC CGUs are there. Okay, building me I can say almost 50% of the building is occupied for CGU A. Balance 25 is occupied for CGU. Correct na? 25 related employees will be working for B and C. correct na? Then entire building value ko 50% of the building value will be added to the CGU A, 25% for B, 25% for C. If you can allocate, allocate it. It is not a goodwill. It is like a normal other fixed asset or PPE. Hello, understood? Like first hit should go to goodwill. ऐसा नहीं होता इधर. It's not a goodwill asset. Can we allocate? First question we should ask what? Can we allocate? Yes. Then what are you supposed to do? Yeah, allocate and test for impairment. As usual. Nothing separate rules and regulations. कुछ नहीं है इधर. Okay. No sir, I cannot allocate it sir. Very difficult for me sir. And then what should I do? Corporate assets are not allocable but related to all CGU. Correct na? Yeah. Right. Related to the company as a whole. To the company as a whole. Got it? I mean to say now, if I say my company has A plus B plus C, this is the company, then you should say corporate assets. Because you can't allocate it. It is related to all. Okay. That time when you are just checking, no, then you should check, add all these items. Overall, what is the company ka recoverable amount you have to check. That time you should allocate it. Did it happen too much? Impairment? Right. Oh, yeah, but anyhow, luckily or whatever the reason, they are not asking too much. Okay. That's where, okay, fine. Practically very less application, I told. Practically people do not follow. But somebody intentionally wanted to check, they can. Yeah, you're asking something. You already bought, no? After buying, what will you do? Then impairment loss only you can do. When you are buying, you thought it will grow. That's why you paid excess money and bought it. Correct. Now, then if you feel like it's not going to get me future economic benefits, then next year you should impair that goodwill and etc. will be impaired, automatically impaired. Because goodwill is something, correct, now you can't imagine exactly. Are you really going to get you paid excess, correct, but are you really going to get the benefit like that? God knows, correct, now you may get, you may not get. Sometimes, yes, people do pay too much overpricing, market may it happens, right? After a few days only, value will fall down like anything. Just share market if I compare, you never know. That's why we are testing every year. That also, if you say specifically, if it is allocated to a specific thing, then we wanted to test. If it is allocated to entire company as a whole, or at least group of CGUs as a whole, if we have allocated, then not required to be tested every year. Okay, let's go to the last concept of what is that? Where each situation, whatever the situation, I'll take you through from the textbook. Directly from the textbook, I'll start explaining. That's better. Already ready-made numbers will be there. Otherwise, what happens if I try to create a question? I can create, but again, I need to go back and correct every time because numbers will not tell. That is, some kind of questions will have that issues. Why should I break my head? It's already readily available to question and answer. Correct, na? Right. But the situation I will tell you. Yeah. First, Ind AS 103 ka some knowledge you must be knowing it, but just I need to recall because it is linked to business combination. That is the reason you have to recall. Okay, right. Here NCI, non-controlling interest, you are aware, correct na? NCI initially, what do I say? Initially, it can be measured. It can be measured how? Two methods, yes. Initially, there are two methods are there. That is accounting policy choice. This is also accounting policy only. Accounting policy, when I say what? All subsidiaries has to follow same method. Correct? One subsidiary ko one method is not choice. When I say accounting policy choice, uniformity or consistency has to be complied with. Okay. First method is what, my dear? You can measure it at fair market value of the NCI on the date of acquisition. Or next one is what? Proportionate method. Correct? Now proportionate of fair market value of net assets. Any one method you can obviously you can choose and follow. Okay, na? Right. Question number 1. First thing, whatever the concept I am following, if you have followed FMV model, right, this is not applicable. Whatever I am explaining, have you understood my point, my dear? A concept is not, whatever I am going to teach, not applicable. Okay, right, it is applicable. If you are following the proportionate of net assets method, if you are taken, then impairment laws related to this will be applicable. Okay, next. Here, sir, question, this is point number 1. Point number 2, sir, we have acquired 100% of the 100% stake, then nothing applicable. Okay, right, this concept is obviously not applicable. You should be having NCI. You should be having NCI. Okay, if no NCI, obviously no concept. NCI also FMV may measured, not applicable. Only proportionate method may, if you had followed, then whatever I am telling, that is applicable. But have they asked this question in the past? I don't think so. ICA Institute material, I think one question is there, if I remember. Not there, huh? I think one is there. That much I remember. Okay. Yeah. One question is there, I remember. I created already one question in the past, but when I saw this question, that was a good explanation. I think that's why I think I must have copied it. Same question. Hmm. This is the concept, my dear. This is seriously bit hi-fi concept, should not be tested. Okay, fine. But yes, is there such concept? Yes, there is a concept. It is dealt by appendix to the standard 36, not directly dealt in the standard. Okay, yeah, it is appendix in the sense that is a interpretation standard basically. Right. So I'll give you little time, just run through these elements. Then we'll immediately will handle this sum. This sum, if you handle, means with number clarity will come. That's all. Okay. Just have a look at the wordings. So what is that here? If you can understand, first is paragraph is general. That is not specific to the concept. First standard is says what? First para says what, my dear? Goodwill is acquired in a business combination should be allocated to each of the acquirer. That's why I told. Purchasing company CGUs ko you should first priority should go, because selling company ka already have taken at market value. Correct, na? Why should I add it to that assets? No, not required. Why did I pay for excess to you? Means I must be getting value to the existing businesses. That's why existing acquirers CGU, correct? Acquire CGU or group of CGU expected to benefit from the synergies of combination. Right. If the entity measures NCI, in which ratio? In the proportionate of interest in the net identifiable assets on the acquisition date, Goodwill attributable to non-controlling interest is included in the recoverable amount related to CGU, but it is not recognized in the consolidated financial statements. Key point first you need to have understanding, correct na, clarity. Then grossing up concept will come automatically. Okay. Yeah, the point here, simple point here. Fine. The subsidiary is there here. Okay, subsidiary. And we have acquired how much, sir? Say we have acquired 80% of stake. What is that? 80% stake, correct na? 80% stake you purchase it for 8,000 crores or something. Just simple number. Agree? Right. So my purchase consideration, this is what my PC, fair market value of PC is this number. Agree? Right. So if I say fair market value of net assets of this company is equal to maybe 6,000 rupees only. How much? 6,000. Hello, correct? Right. What do you do normally? Now NCI, I will take it. NCI is nothing but 20%. 20% in the sense 20% of what? 20% of 6,000 you are supposed to take, because fair proportionate method you said. That comes to how much, my dear? 1,200 will come. So totally how much? Correct. Minus fair market value of net assets. Correct na? Right. That is equal to how much? 6,000. So that is equal to 3,200 rupees is the goodwill. Agree? Correct only na? Right. In this method, this is what your method followed. Correct? Right. Now, question is what? Na? In the consolidated financial statements, if I say net assets is only asset, correct? Entire, are you getting the 6,000 rupees of 6,000 rupees total assets will come to my financial statements or not? Correct. Now, when you are testing the impairment of the subsidiary, what did I say? When you are testing the impairment of subsidiary, what do you check? Yeah, here 1 second. Here, if I say goodwill is equal to 3,200 rupees, do I record? Yes or no? Correct. Here, goodwill also will come. Na? Assets also will come. Goodwill also I will take in consolidated financial statement. But frankly speaking, Amma, this is 100% assets of the subsidiary company. Agree, na? Right. Is it 100% of the goodwill of the subsidiary company? Question, is it clear? Is it 100% goodwill of the company, subsidiary? It's not actually. It is actually 80% goodwill only you have taken. How 80% goodwill you have taken? Example, just correct, na? How much you paid, Nama? 8,000 you paid. 8,000 you paid for 80% or not? Correct. If I take directly net assets how much? 6,000. 6,000 also my share only if I take it 80%. How much will come? 4,800. If I remove that number, isn't it 3,200? Correct, na? So this is how much, what is exactly goodwill? 80% goodwill only is coming in the balance sheet. It is 80% related goodwill, not 100% goodwill of the subsidiary. Hello, understood? Right. If I had taken the fair market value, 1,200 is come because of the 6,000 into 20%. If I had taken the fair market value over there, my goodwill would have been not 3,200, would have been much more. How? Simple example I will calculate. Do you have calculator? Correct na? 80%, 8,000 ko 80% I paid means obviously 20% is equal to 2,000 I must have paid na? Yes or no? So now under that circumstance, if I keep here 2,000 rupees, if I keep it here, correct na? So will I be increasing it to 800 or not? 4,000 would have been my goodwill. But because you are following the proportionate net assets method, you are recognizing the goodwill of only 80%, not 100% of the subsidiary. Correct? Hold on. Now the question is what? Tomorrow I will be test checking for the impairment loss. Correct? Tomorrow when I check the impairment loss, what do you say? 6,000 rupees of the carrying amount plus 3,200 rupees of goodwill will be tested with the market value FMV or NRV, FMV minus selling, FMV minus assume selling cost is equal to 0 करके ले लो for the time being. FMV minus selling cost is equal to NI say, correct na? That is equal to 8,000 karke if I keep it, this 8,000 rupees or whatever, 7,000 rupees only I'll keep it. This is 100% of the company value is equal to 100% subsidiary value is equal to how much? 7,000. But here 6,000 is related to 100%. 3,200 is equal to 80%. But you are comparing with, is there any comparability? No. Correct? Now read the line carefully. Now you read this line once again. If the entity measures the non-controlling interest in this method, what is happening? Goodwill attributable to non-controlling interest is included in the recoverable amount of the CGU. Recoverable amount of the CGU means E number. 7,000 में 7,000 includes 100%. 100% includes 20% वाला भी है. 80%, 20%. Both are sitting in this one. Correct? But yes. But what is that? What is the sentence it is telling? But goodwill is not recognized in the consolidated, correct na? Goodwill related to whom? NCI is not recognized in the consolidated financial statement. So to make it comparable, what should I do now? To make it comparable, so first what? Gross up karna. Gross up karna means this is related to which number? 80%. If it is for 100% means I should add 800. Now what are you supposed to do? Now correct na, compare. Now totally how much will come? 10,000 will come. 10,000 is the carrying amount. 7,000 is the recoverable amount. So there is 3,000 rupees of impairment loss. Hello, correct? Right. E 3,000 rupees should be out na? Hello, correct or not? 3,000 should be out means 3,000 should be out between in this ratio. 3,200 is to 800 ratio mein it should be out. Getting my point? Calculator use karo. 80% of this how much is this? 2,400 will come. Correct na? So 3,200 minus how much? 2,400 you should cut it. Correct na? That means still 800 rupees will continue. Goodwill will continue. Goodwill normally if I do not do this gross up na, what you would have done? E 3,000 would have hit directly 3,200. What would have been left over? 200. But now it will continue to be 800 rupees will continue to exist. That's the only concept, my dear. Now look at the numbers. You will get better clarity on this. Okay. Yeah. A Limited acquires 80% of shares in the subsidiary company for 3,200. Okay. At the date of acquisition, B Limited identifiable net assets are 3,000 rupees. NCI proportionate net asset method selected. Otherwise, concept is not applicable. So goodwill, what did he do? Okay, right? PC 3,200. E 3,000 is the net assets na, into 20% is equal to 600. 800 rupees goodwill has come. Till this, I think no doubt. At the end of the financial year, balance sheet ending. Balance sheet ending means same net assets will not continue. No, they must have bought new assets. They must have depreciated existing assets. Inventory must have been sold. Trade receivable must have been collected. And new sales must have happened. Correct na? Numbers will be keep on changing. No number will continue except goodwill. Agree? Right. So what is the number, my dear? B's carrying amount of the net asset reduced to 2,700 rupees. Yes, whatever the reason, excluding goodwill. Yeah. Recoverable amount of the asset is equal to, example, 2,000 rupees only. What is the impairment loss allocable to parent company, NCA company? How much? If it is 2,800, what is the amount of loss that is allocable to this? Correct? Right. Now, what is the concept you should do now? First thing, you have to gross up. Correct na? E 800 is applicable to 80% of the thing or not? Okay, so NCA के लिए 200 can I say? Correct na? So what should I do? 2700 is the book value plus 1000. That is equal to 3700. Correct na? E 3700 is becoming how much? 2000. Situation number 1, 2000. Correct na? 2000 hai to how much is the loss? Correct na? 1700 loss में first पूरा 1000 cut. Yes or no? That is related to NCA, related to parent company, pura cut. Hello, correct or not? Right. So total goodwill of 1000 is gone. Now what is left? 700 is less. E 700 is should be from reduced from the assets. Till this level, is it clear? Right. Look at. That's all. Your assets is equal to 2000. Normally, if you have not grossed up, what you would have done? Tell me. Different way, correct? Entire 2700 ko, I mean plus 800 if you have taken, correct na? Then impact may be there, right? So that's why what is again, look at here, 800 of mine, 200 of this, so 1000 rupees of this. Other assets are 2700, totally 3700 which we have determined like here. Agree? Yeah? Agree. Okay, right, 3700, that is compared with 2000 rupees of e-money. Right, so there is impairment loss of 1700. E 1700 first should attack on, correct na? Goodwill. Goodwill means here I should say related to, because it is recorded in the financial statement 800, which is not recorded, what do you remove? But we should count it, correct na? We should say this also 200, I should say already sir 1700 में 1000 rupees goodwill hataya, correct na? We have removed. Remaining 700 from the other assets I am cutting. That's why my 2000 is continuing. Hello, correct? Right. Second situation. Here, this is, what is this? Impairment loss on goodwill. Yes, 800 pura impairment loss is there. Other assets cuts 560 rupees. Yes, but anyhow, other impairment loss of NCA also, anyhow, correct. Total assets ka, other assets ka impairment is related to both the things. Now, second situation we are supposed to handle. Are you comfortable with first one first so far? Can I go with any doubt? Hai to pucho. No doubt. Okay, come to the second point. Second point, I'll erase this concept. Okay, right. Now tell me, what is the carrying amount, my dear? 2800. So, correct na? Sorry, recoverable amount. How much? Now what is the impairment loss? 900. In 900 you should cut from where? Goodwill. Goodwill you have recorded, unrecorded, total put together how much is there? 1000 is there. Correct na? Still after 900 also there will be some balance or not? Yes or not? It's there, correct na? So, in 900 ko what should I do now? 80%, 20%. 80% means how much? 720, correct na? What is in the books already? 800 is there. 800 mein how much is gone? 720 is gone. Hello, correct? So, still goodwill will continue to be at 80. And have you touched the 2700 number? No, we didn't touch. Have you touched? No, impairment loss is not there. So, your carrying amount of the assets is going to be at the end of the day will be how much? Goodwill of 80 remaining, 2700 of other assets. So, 2780 will be the total number. That's the only small concept. Okay. If you read one correctly one time, next time suddenly if they ask question, nothing will be under our control. You will be able to correct. Once after going home, the question is there in ICA textbook. Fine. Spend little time. Then it will work out. He gave both the options. Not one option. Both the options he gave. More than sufficient to handle it. Okay, na? Right. So that is, these are the important, very important points. Reversal of impairment loss, I told you in 105 mein bola. Correct na? What is that? Carrying amount if they have never impaired in the life. There I said never classified as held for sale. Here what you will say, carrying amount, if it was never impaired, what would have been the carrying amount? Or recoverable amount, whichever is lower. Goodwill recovery will never happen. As we discussed already that sentence also, goodwill once it is charged off, you cannot recognize. It leads to recognition of self-generated goodwill, which is prohibited. Okay, so we are done with impairment loss, a big standard, correct? 36 out, done. Right. So chalo, let us spend some time on Ind AS 12. Yeah, income taxes. Let's try how much possible from this. See, the standard is no doubt beautiful standard. Okay, but at the same time, thought a difficult standard. Difficult in the sense, difficult in a confusing standard. Confusion also subject to. What is subject to? I mean to say, if you think slowly, you will come out with correct answer. If you try to jump suddenly, then correct, perfectly wrong answer you will come get. This is the for sure, irrespective of your experience in the past. I mean to say, consider me also. Okay, right. Maybe because we dealt number of situations, maybe obviously better than you guys. We can tell deferred tax asset or liability, we can tell just like that. Okay, right. But if your first time you are starting now, you have to be slow. Right, think twice. Right, some small techniques I will give how to think. Then you will not do mistake in that angle. Okay, right. Otherwise, it is very much possible to anybody. Correct, na? They will tell only any one of the two only. Correct, na? Either deferred tax, deferred tax asset or deferred tax liability. If it is not liability, obviously asset. That's all. Correct. So that's where the problem comes. Fine. Here, entire income taxes, as you know, income taxes are, first one is current tax, correct? Yes, next is deferred tax. Next is deferred tax. Yeah, current tax is obviously arising from local laws. Right, that is India mein Income Tax Act. Right? Simple. If you are making a provision, correct? What do you record provision ma? Provision say current tax expense account debit. Correct na? So provision for tax. Simple. Right. Sir, I paid advance tax, sir. Okay. Advance tax asset account debit. Advance tax is an asset. Correct na? To cash or bank, whatever it is. Third is what, my dear? Once assessment is completed. Assessment should be completed. Assessment completed, done. I got a refund. I got a notification. Assessment done करके एक mail आया, message आया, कुछ आया. Correct ना? That day what are you supposed to do? That day PFT account debit, correct na, to advance tax, maybe to cash or debit cash, maybe you must have paid or you must have refund collected or something would be there, correct na? Right, that number either, I mean to say, if you ask me to write that, okay, to cash I may say, or cash account debit also I will say. This is a balancing figure. Clear? Next. Generally, general mistakes are what does it happen? General mistake, two numbers you have to offset, my dear. You have to offset. You have to present it current taxes karke one on the face. Where will it come? On the face of balance sheet. As per Schedule 3, Division 2, current taxes, either asset or liability. Correct na? What did I say? Current tax, either asset or liability, bracket mein net. On the face of the balance sheet, it has to come. Don't put it under provisions में also, no. Schedule 3 format देखो, current tax assets में आ जाएगा. Directly it will come, appear on the balance sheet. Is it clear? Straight, simple with respect to current tax. Correct? Right. And some companies' financial statements, it's okay. These are obviously, whatever I am talking is not a listed company. Obviously, small company. They show advance tax also. They show current provision for tax. It's wrong. If it is both are arising from the same company, same company, correct. Now you obviously have an offset of, correct. Now I paid advance tax. The department what will it do? They will refund advance tax and they should pay separately tax. No, advance tax it paisa le lenge. How much you assessed, our number they will offset it with balance only. I will pay as a self-assessment tax. Me if something is required to be paid, I will say I will pay it. That's all the target. No, basically. Yes. So we have to present it set off, not separately. This is not okay. Done. Come to deferred tax. Okay. The current tax is that much only sufficient. Yeah. Deferred tax, simple thing, no idea. Yeah. For this deferred tax, obviously, as you are well aware, you should be having some idea about local tax. Correct. Na? If you don't know current tax, then learning deferred tax is just difficult. Correct. Na? Obviously, if you don't know local tax, how do you learn deferred tax? So income tax should be learnt perfectly, then only deferred tax will happen. Next, it's not too difficult, but yes. Okay, how do you calculate deferred tax, sir? Very simple. What is simple? Tell me. First, carrying amount. Some number will be there. Then you have to determine the tax base. This is what crucial. Correct, na? Tax base. How to determine tax base? Yes, there are two definitions. Two definitions has each two lines separately. Tax base of asset, tax base of liability, under two different circumstances. Okay, right. So our number something is there. Okay, say if I say this is equal to 1000, this is equal to 900, then this is called temporary difference. What is it called? Temporary difference. Correct? E temporary difference, right? What is deferred tax? Deferred tax is equal to temporary difference into tax rate. That's all. That is deferred tax. Agree? This is how it will happen. Next, first our focus should be on what? Tax base. Sir, what is carrying amount? Carrying amount is nothing what is there in the books of account. That's all. Next, first and foremost important point. Do you do tax base and are me correct? Na? Deferred tax on the equity element? We don't do. You got my point? Deferred tax on what? What you will do? Only asset or liability. Tax base of asset or liability. Correct? Na? It is only on asset or liability. Yes, not on equity elements. Other equity element. No. Other elements, we don't touch. There is one exception to this rule, I'll tell. Not exception exactly, that is a different way of reading, that's all. Okay, compounding financial instrument, embedded derivative circumstance, some small point is there. Something paragraph number 32, if I remember correctly. Okay, right. Sure, that is not relevant right now. So equity elements ko not applicable, asset or liabilities ko only this is applicable. Clear? Right. So now let's go to tax base of, okay, tax base of asset. Let's look at the definition. Okay, right. If I see the definition, first question what we should ask, no? One should ask one question. What is the question? When I say asset, what are the examples of asset? Tell me, Nana. First balance sheet head. Asset means it can be property, plant and equipment or intangible investment property, one kind of asset. Next, I must have given a loan to somebody. Correct, na? I must have investment in the equity shares. Can I say? Right. This can be inventory. Correct, na? This can be trade receivables. Agree, yeah? Right. So asset means don't keep only PP in the mind. If you keep only PP in the mind, then you're out. You have to keep all the things in the mind. Then thinking style will be perfect. Okay. Right. Listen carefully. When I say, my dear, tax base of asset. Okay. First question. How do you get the money from the asset? Either by using the asset you will get the money, or collection also can happen. Correct, na? If I say trade receivable 100 rupees, how do you get the money? Means that guy will give me 100 back, that's all. Yes or no? Loan I gave it to somebody 1000 rupees. Well, how will get? 1000 will come back, he will repay 1000. Hello, correct? Right. Loan is loan, interest is interest. Interest receivable, I let separately. Correct. Now the question is, when you receive the cash flows, future economic benefits means money flow. When money comes in, is it taxable? Question mark. Are you getting my point? The collection of money, is it taxable? Correct. PPE, why are you holding? Is it to sell? No, no. PPE, what is the intention? To use it and get the money. By selling those products, you will get the money, not by selling the PPE. Agree or not? Right. Whether what is the question? Whether future economic benefits inflow taxable? Question mark first. Right. Depending upon the answer, you are done with the concept of tax base of asset over. What can be your answer, my dear? Yes, taxable. No, not taxable. Correct. What is taxable? PPE hai example. Correct. Na? Can I say that? Property, plant and equipment. Right. Inventory. PPE, how do you say? PPE you don't sell. PPE is a goods will manufacture or service will generate it. That services will get the sales money. Agree or not? Next, inventory today is there. This will be sold tomorrow. Sales it will happen. Sales will be offered to the tax purpose. Do you agree or not? Correct. Loan se paisa aayega. Will not offer to government. Correct. Interest will offer. Hello, correct? Right. So I'll say interest receivable. I'll say here. Interest receivable. I'll say interest receivable. Agreed. Okay. Whatever the money comes, money look at. How do you get the money? Money will come by using the asset or by collection of the asset, by selling the asset. Anything, any one of the three situations, it will happen. Yeah. Is it taxable? No, not taxable. When it is not taxable, sir, I gave loan. Correct. Here also current investments if I sell, is it taxable or not? Yeah, yeah. Hey, sale consideration mein aayega. If you have cost to reduce it. But sale proceeds, first you will say sale proceeds taxable. Allowed adjustments are different. Your cost of investment will cut it. Balance only you will pay tax on it. But taxable only na. Loan you gave and loan you got it. Yeah. Do you show somewhere like 400 rupees received collection is tax sale proceeds karke? Do you show? No, why will I show? Only interest amount I will offer. It will not come into your income tax assessment. Mein 1000 rupees loan diya, 1000 rupees loan I got it back. Income tax calculation mein do you show somewhere? Never show. But current investment or investment sold, will you show? Even though you got a loss, even though you got zero profit, still you will show. Is it clear? There if you have clarity, then answers are easy. So loan money, trade receivables, correct na? Trade receivable. Yes, debtors have to pay money, they paid money. That's all. I don't offer it to tax. Why will offer? I already offered. Sales are already offered last year. Correct na? Trade receivable collection I will not offer in the future. Clear? Next. If you say yes, correct. Yeah. Now what is that? What is the amount deductible? TB, tax base, is equal to amount deductible from the above. That's all. Amount deductible from the above. Say example, investments. Investment selling price is equal to 1400. What is deductible for investments, my dear? Investments ka cost is deductible, or indexed cost if it is applicable, that is deductible. How much is indexed cost? 1200 rupees is deductible. Correct na? 1200 rupees is nothing but TB. That's all. What is deductible from the sale proceeds, or what you offer to the government? Hello, correct? You understood my point. What is deductible is the TB. Yes. Next, interest receivable, is it offered? Yeah, it is. Correct na? But whether you interest receivable is interest is already offered. When you get the money, I think I should take this to this side actually. This side I will take it. I will take it here. Why I am taking it here, my dear? Means interest is already offered. When you collect the money from the people, correct? Interest is offered on accrual basis. Agree or not? Tomorrow collection will happen next year. When it is tomorrow collection happen, that time again will offer. Will not offer. It's already offered in the current year. Collection Correction time I will not offer once again. Under this circumstance, what is TB? TB is equal to carrying amount. That's all. When TB is equal to carrying amount, no temporary difference. When there is no temporary difference, then obviously no deferred tax. Okay, right. So here question, simple example. Sir, PPE is there. You will take PPE example. Right. Next, you should think, my dear. Deferred tax is considering the past, deferred tax is considering the future. Deferred tax is considering the past, deferred tax is considering the future. Always future. Okay, correct. Means tomorrow I have, correct na. Simple example, why deferred tax has come karke, one small beautiful thing I can tell. See, I have a PPE, 1000 rupees I keep. What do you mean? How do you read this? Balance sheet mein PPE 1000 is there. How do you read this? How do you read means? Your way of interpretation of 1000 rupees is there means what? Closing balance of PPE is 1000. Okay, done. Next. PPE worth is 1000. Okay, one way. Next. We invested 1000 is that. Okay, that is your answer. Next. Value is PP same. Okay. It is after depreciation net book value. Depreciation benefit need not be 1000, no. Tax purpose it will be different. This is books of account. Next, how do you read this 1000? Can't you say that 1000 rupees will come in the future minimum? Correct. Now that is the meaning. No, asset is something which will give me future economic benefit. Means 1000 rupees I will recover. Can I say? By using the asset or by selling the asset? No, I can't recover sir 900. It means you must have impaired here. Then why didn't you impair? Correct. Now it's books of account mein already coming means minimum of 1000 I will get money in the future. Do you agree with me? Correct. Now, say example, my dear. If I say equity share capital also 1000. In this case, what will happen? Assumption is what? If you look at this balance sheet, 1000 rupees will come. 1000 rupees fully I will give it to equity shareholders. Agree? Yeah? But it may not be the fact exactly. Why, sir? Why assume? Why? 1000 rupees when you sell. Correct. Na? So your sale proceeds is equal to 1000. But the depreciation allowed is equal to 800. Depreciation allowed means what are you supposed to say? This is your tax. Tax into 30% if I put, are you supposed to pay? 60 rupees you should pay. 60 rupees you will pay to whom? Government. Correct na? Then is it that these guys are eligible for 1000? No, actually you should say 60. Government to go liability DTL, that is equal to 60 you are supposed to pay. Now it is giving correct picture. Agree or not? When I say asset will give you probable future economic benefit inflow, when that flow comes probably, then probable tax outflow also will be there. Because 1000 if you sell, 1000 deduction is not available. If it is available, no problem. If it is not available, you will end up paying tax. After paying the tax, balance only will go to equity shareholders. Understood? That means equity is not stated correctly. When this is probable, correct na? When this is probable, this is also probable. Because you have a deduction depreciation element only, I mean allowed depreciation is only 800. Hope you understood. That's why deferred tax is very much required. Shall we go ahead? Right. So now here, so 1000 rupees if I come here, 1000 rupees if I sell or if I sell the goods, I mean I'll say I am going to get the benefit of 1000 rupees in the future, but allowed depreciation because I must have already got excess depreciation in the past. That's why now what is remaining depreciation I'll get from the government is only 800. Correct. So I 800 I will reduce it. So E 200 is, what is this E 200 rupees is temporary difference, TD, correct? Yeah. So temporary deduct into rate, that rate is going to be 60. That is going to be what? Are you liable to pay? Are you liable to pay this, or are you going to get the benefit out of it? Liable to pay, correct? Now, how liable to pay? You are expected to get more benefits than the deductions allowed, correct? Now, so ETD, temporary difference, is taxable. It's like tax payable. Hello, correct? Huh? It is leading to tax payable. That's why simply we'll say, when I say temporary differences, when I say temporary difference is going to be two types. One is taxable temporary difference. Next is deductible temporary difference. Correct? When do you say taxable temporary difference, my dear? With respect to asset. When you have a carrying amount is greater than the tax base, means what? I'll get more money, but I'll get a lesser deduction. When you get lesser deduction, the balance, on the balance amount, are you supposed to pay tax or not? It is. Then automatically on the asset, same side, deductible in the sense what? I'll get a benefit out of it. Benefit out of in the sense carrying amount is less than the, correct, na, tax base. I will be selling for 1000, but I will get a benefit of 1500. So I am getting more benefit. More benefit is an asset to you, correct? So the taxable temporary difference will be leading to deferred tax liability, and deductible temporary difference will be leading to deferred tax asset. Agree? Right? So in case of the tax base of asset, what is the question we should ask, my dear? Whether future economic benefits, means when you recover the money in the future. When you recover the money, future economic benefits means money. When you recover the money in the future from the asset, is it taxable? Question mark. If you say yes, then what is the amount that will be allowed for deduction? That is the tax base for you. Okay, that not necessary carrying amount will be there. That may be tax cost, that may be indexed cost, that may be some other number. Are you getting my point? What is allowed? If it is a, suppose I purchase land, not now, I purchased land 10 years before, correct now? I wanted to sell, I mean I don't sell, but if I sell it, what is allowed for me? Indexed cost will be allowed. You know, indexed cost hai to one rate, without indexed cost is another rate. Assume I am going by index because that is more beneficial to me. Hello, understood? So what is my tax base? Not the book value number, correct? Now indexed cost will be applicable. Then you should keep indexed cost for doing the calculation. Have you understood? It is not always cost. What is the amount that is allowed as per the Income Tax Act? That you need to read. Hope you understood. Right. So that is the basic point. No, sir, here I don't correct na here. Is it taxable? No, collection is not taxable. Tomorrow if I collect trade receivable money, no, I don't get any, I don't pay any tax. I don't show it to department. I gave loan, I got the loan back. I do not. Interest receivable is there. Interest already offered in the current year. When I collect the money in the future, correct na? That time I am not going to present it as a tax, correct na? Collection is not taxable. Collection is not taxable. Then TB is equal to carrying amount, correct na? Then no deferred tax will arise because of this. Are you comfortable so far? Right. Shall we go to tax base of, what is that? Tax base of what, my dear? Tax base of liability we should look at. Yeah, here also very simple actually, not too complicated, but you need to read it slowly, correctly. Right. If you read correctly slowly, na, that's all, my dear. Actually, the problem comes with the tax base. Tax base correctly understood, no. There are some small exceptions are there. Other than the exceptions, remaining all are very, very, very easy. Okay, hardly few minutes it will take. Right? Tax base of liability. First question. Liabilities, liability type mein what a liability will be there? Loan is a liability, correct na? Trade creditors is a liability, outstanding liability is a liability. Next, provisions are liabilities. Next, advance from customer is a liability or not? Yes or no? Right, that's all. First question, is it advance? Is it advance income? Advance income means advance, it may be advance of goods or sale of goods, it may be advance rental income, it can be any kind of advance income. Are you getting my point? Advance already income came sitting, deferred income also. Okay, deferred income also will come here. First question, yes, advance income also is liability, no doubt. Answer can be what? Yes, answer can be no. Right? If it is, first I will treat the no point. It is not advance income. Means advance income illanta, what is the point? Example is what? That means it may be loan. Correct na? It may be provision. Provision for warranty, I will tell. Correct na? Provision for warranty, provision for gratuity. Correct na? Provision for trade payables. All these numbers will come. Other than advance income, everything will sit under this side. What is tax base? You are trying to calculate tax base now. Correct na? Tax base means what is the sentence, you know? Carrying amount. Some say I'll keep some number. Okay. Yeah, carrying amount. Which numbers are? Say provision for gratuity करके मैं बोलेगा. How much numbers are? How much number? Let me keep a number called 1000 rupees. I'll keep it here. Okay. Now balance sheet में how much number is there? 1000 as a gratuity provision. As per the actual valuation, 1000 rupees you got it. Excellent. Now the question is what? When you make the payment, it's a liability means what? It is probable that you will pay later. Agree or not? When you make, assume tomorrow only you will make a payment, future may you will pay. How much is allowed for deduction? Paid basis, correct. Full amount you will pay. Full amount is allowed. Yes or no? Next year you are going to pay full amount. Think karo na aisa, what is your problem? 1000 rupees is sitting in the balance sheet as a liability. When you pay 1000, what is the amount of deduction you will get? 1000 you will get. For the example of provision for gratuity, is your answer correct? Yes or no? That's all. 1000 if I pay 1000, I will get the deduction. When I will pay in future. That is not the question here. Are you getting my point? Right. So I'll do like one thing. Yeah, which I will say like gratuity. I will record as like a loan. Okay, carrying amount. This is equal to 1000. This is equal to 1000. Right. Allowed deduction. Allowed when settled. If you pay 1000, what is the amount of deduction you will get? The 1000 pura I will get, sir, deduction. Correct na? This is TD, TB, tax base. 0 is tax base. That's all. Okay. Next. Loan you took how much? 1000. You repaid 1000. What is the amount of deduction you will get? Why deduction will come for loan repayment? Income tax may why reduction will come? Loan repayment expenditure. No, no. Loan repayment, correct. Gratuity payment is expense. That is different. So here nil. I will not get deduction. So then what is the PB? 1000. That side is over. Half of the tax base of liability over. Again, trade creditors. Tell me, trade creditors if I take 1000 is the balance. If I make a payment to them in the future, do I get a deduction of 1000? Already you booked purchase in the current year. You will make a payment in the next year. Where will you get again deduction? Or will you get deduction double time? Nothing. So same like a loan it will happen. Agree na? That's all. That's I mean I'm telling you na. Slowly if you think na, answer will come. If you think fast, nothing will come. Okay, right. So suppose next situation. Yes. Yes means what? Advance income. Advance income आ गया. Advance income means advance I told na. Advance from customers. advance rental, advance rentals received, whatever, such kind of items. That is also liability, no doubt. Okay. Now look at what is this here, what will happen, sir? Carrying amount. Okay, 1000 rupees. Okay, minus which is not taxed in the future, which is not taxed in the future. What is not taxed? The advance ka rental you collected. What will happen normally? I gave you 1 month ka 1 year ka advance de diya. Correct na? But 1000 will be taxed in the next year. It is sitting as a liability today. Tomorrow next year will you transfer it to P&L income? Why? It is advance for the current year. Next year ko that is an income. Will that be taxed or not? Taxable income, correct na? But what is the question here? Which is not taxable in the future. 1000 mein 1000 is taxed. So what is not taxed is 0 not taxed. Hello, correct? 0 not taxed. Then this is the tax base of 1000. So you should see first 1000 is the number. Okay, carrying amount. How much is taxable in the future? Taxable is equal to 1000. Then what is not taxable? 0. 0 you should bring it here. अरे समझ में आया? First to do this way. Mentally you should do this. Then put the number accordingly. Are you getting my point? So 1000 I received. Only 800 is taxable in the future. Okay, then what is not taxed is equal to 200. Then bring 200 here. But generally everything correct. Now, sometime what will happen? Suppose department says like this. On receipt only taxable. क्या बोला? Department says on receipt taxable. On receipt taxable. करके sentence given in the question. Now what is your answer? On receipt is taxable. How 1000 rupees you received. Your books of account में books में क्या लिखा? Books में you said like cash account 1000 rupees to advance 1000 rupees you booked. The advance will become in the next financial year. Correct. The next financial year the advance will become income. That is books. Agreed? But tax purpose what is this? Correct. Now current year only already taxed. Now read the line here. Now read the line carefully. Now I am changing the thing. What is taxable? What is taxable in the next year? 0. Why? Because already taxed. So it is 0. So how much is not taxable? 1000. So I will bring 1000 here. Then automatically this will become 0. Understood? It is always depends on how you read the line carefully. If you read the line, problem will be solved. Okay, right. One important point I will tell. See, look at this. Maybe we will continue this discussion tomorrow also. But one or two small questions, points, I will clear it. Okay. Maybe tomorrow first half, some half an hour if I discuss, it will be perfectly completed. Yeah, listen carefully, very, very carefully. Suppose you have a loan taken. So this is a financial liability. How much, sir? 1 lakh rupees taken loan. Correct? But there is transaction cost. As per IFRS 109, transaction cost, sir, 3000 rupees transaction cost. So what do you present in the financial statements, my dear? 97,000 rupees will be the balance sheet mein line item will come. Agree? Yeah? Yes. Now how do you deal this in the tax base purpose? Question clear? In this case, simple to without breaking your head. Okay, right. Normally transaction cost what will happen? Allowed in the year of payment. Allowed in payment basis. You paid in the current year you will get the exemption. You can charge it off to P&L. where not in the books of account, in the tax books. Hello, correct? Right. So like this, when there is one item is there, another item is supposed to be deducted, then 97, something like that is happening, no? One common sense concept you should keep in mind. Deal this as a liability, deal this as an asset. Net answer club karo. Problem solved. Have you understood my point? What did I say? Liability. First 1 lakh rupees is a loan taken. Liability, correct na? You will fall under E category. Hello, correct? Right. So loan ka loan. Yes. Loan is a liability. Liability the carrying amount, that is equal to how much? 1 lakh. How much is allowed when allowed in the future when you make a payment? 0 allowed. Correct na? So what is the tax base? Tax base is equal to 1 lakh. Agree? Done. Hold on. Next. Next is what? Transaction cost. Transaction cost is asset. Assumption. One is asset, one is liability. That's why I am reducing it. Agree na? Right. In case of asset, what is the rule, my dear? इधर देखो asset का rule क्या है माँ? Whether future economic benefits are taxable. Future economic benefits are taxable. Yes, it is taxable. Because of the loan, you will get the benefits later. Okay, so we will be falling under this. What is deductible in the future? Correct na? Amount deductible is what? The question. Now, question here. Come here, my dear. How much is what is deductible? Out of 3000 rupees, what is deductible to you? It's already deducted. Why already deducted? I told you, it is allowed for the tax purpose already. Whenever you pay processing fees, this is a processing fees. When you pay processing fees, will you charge it to P&L in the tax books only or not? You will charge off. Hello, correct? So that's why what is deductible? 0 is deductible. What is deductible? 0 is deductible. Hello, correct? Now that is equal to tax base. Agree? Right. So that is tax base, correct na? Here tax base is 1 lakh. Here tax base is 0. So total tax base is equal to how much? 1 lakh. So now here carrying amount is how much? Carrying amount is equal to 97,000. So there is a temporary difference of 3000 rupees is there. That's it. Treat two items separate. Then combine the tax base. Then answer will be simple. If you do independent, club करके 97 को क्या they will die. You will not get correct answer. You may get correct answer, you may not get correct answer, unnecessarily breaking your head. Hello, understood? Right? Suppose if it is accounts receivable, trade receivable. Trade receivable is simple. Not trade receivable is equal to 10,000 rupees minus ECL, expected credit loss, 2,000 rupees. That is how 8,000 rupees is coming in the balance sheet. Agree? After provision for doubtful debts, ECL is nothing but provision for doubtful debts. Okay, right. How much is the number? 8,000. Correct? Now tell me, you should deal here also two ways. Or if you are comfortable, I told now, once after practicing, what will happen? You will be comfortable without doing separately also. But initial stages may do separately. Then you will get comfort. Once you get comfort, then you can do separate. I hope you understood. What is the tax base here? Right. My simple way, what do I say? This is an asset, this is a liability. Agree na? So what do I say? Asset situation may, when you collect 10,000 rupees, is it taxable? Not taxable. Not taxable hai to tax base is equal to carrying amount. That is equal to 10,000. So asset one wala clear. Agree? Yeah? Right. Next, liability wala. Is it advance income? No. It is not advance income. Correct na? Advance income hai to assume it is 2,000 rupees payable. Provision karke socho. Nothing is payable. Just example I am saying 2,000. right? If somebody becomes bad really, do you get deduction or not? You will not get a. You will get your income tax may. Provision not allowed, but tomorrow really it becomes debt. You are not talking to today, you will talk future. What is PDD means what? Some guys will become doubt करके you telling. Doubt correct हो गया. Will you get deduction or not? Yes or no? Yes. So this is a carrying amount. What is the amount allowed deduction कितना? 2000 मिलेगा. So what is my tax base? Tax base is equal to how much? 2000. What 0 हो जाएगा. This plus this, that is equal to 10,000. 10,000 is your tax base. 10,000. Correct na? E 2000 rupees is temporary difference. Same thing for inventory, provision for obsolescence or something. Wherever like two numbers are there just for first you grind definition of tax base of asset, definition of tax base of liability, do necessary number of questions ko try karo. Okay, then just remember this. I mean, I feel this will be comfortable, right? Sometime what happens, we can confuse you by adding so much of stuff there, but all the time remember, break that into two, asset and liability, something like that. Then just follow the rules, right? Whatever the asset ka TB, liability ka TB, total the TB is equal to my total TB. That's all. Your answer will be so simple and so easy, actually speaking. No need to break too much of your head. Agree? Right. So you just practice this and come back. We'll see. We'll do the remaining part because that will take another half an hour easily, not less than that. So yesterday we were looking at what is a correct no? I mean, what is current tax, what is deferred tax? Deferred tax my tax base of asset, tax base of liability. Correct, tax base of asset is first question is what? Whether the future economic benefits collection, correct, now is it taxable? If you say it is taxable, then what is deductible from that? Yes, that is going to be my tax base of asset. If you say it's not taxable, then it is current carrying amount is equal to tax base, right? What is tax base of liability? Tax base of liability is something. First, is it an advance income? Correct, first question. If you say no, advance, if it is not advance income, carrying amount minus, and payment of this carrying amount, how much will you get the deduction in the future? Amount deducted, then what is the balance number? Balance number is tax base, right? If it is an advance income, then carrying amount minus what will not be taxed in the future. So what is taxed in the future? If you deduct it, then what is leftover number will come as a what is not be taxed in the future. Our number if you deduct, then the balance number is called tax base. Okay, right. And tax base carrying amount minus tax base is what the temporary difference. Our temporary difference into tax rate if you apply, then deferred tax will come. Next, these temporary differences are of two types. What is that? Taxable temporary difference, deductible temporary difference. Taxable is nothing but payable. Correct. If your economic benefits are more, economic benefits, that is carrying amount of the asset is more than the deduction what you get, that means you will end up paying the tax. So that's why it is taxable temporary differences. Deferred tax liability will come, and from the other side it is deductible temporary difference. Your carrying amount is 1000, but what you get deduction is 1200. Yeah, maybe last years you must have got lesser amount. From today on in the future, what do you get? 1200. That means I am in a, I get the benefit in the future. Benefit is an asset, correct? No? So that is deferred tax asset it is going to become, right? At the same time, we have looked at what? Suppose if you have taken a loan, correct? No? Yeah, if you have taken a loan, what do? Loan minus processing fees or any other transaction cost, we will reduce it and we will show it as a closing balance, correct? No? Right, that is normally it happens. Right now, but in the deferred tax purpose, what are we supposed to do? What we do better? Okay, what we do better? The loan liability you treat it separately. The transaction cost you treat it separately. Correct. And then you get the TB tax base for both the things. Just add those two and say this is my tax base. That is what I feel more comfortable rather than handling it together. Okay, right. So the same thing for the allowance trade receivables, that is ECL, expected credit loss. Fine. Yeah. So expected credit loss and any kind of such deduction is there, then you better you go with this kind of methodology. That will be better. Fine. Yeah. So now what is that what is the point here? Yeah. Here one important point what you say, right? When you say deferred tax, when your creation, okay, creation of deferred tax liability, DTL, creation of deferred tax asset, correct? So what is that it will come? Creation of deferred tax liability. Creation of deferred tax liability. What do you say? Deferred tax expense account debit. Correct? Na? Deferred tax expense account debit to DTL and DTA account debit. Correct? Na? Deferred tax expense I will say income, that is crediting means income only, but still I will use the word deferred tax expense. Correct? Na? Right. First question is deferred tax expenditure, where should it go? Where should it be booked? Is it in the P&L or OCI or anywhere? That is in the profit and loss statement only. Correct? Na? Right. But it is not all the time profit and loss statement only. That's why where to correct na? Where to book? Yeah, where to book? First question is you are recording deferred tax. Example, this is related to PPE. Correct. It is related to PPE. It is arising. The difference is arising because of the depreciation. Correct. Now, where is depreciation booked? In the P&L. Correct. Now, if it is booked in the P&L, then this deferred tax expense arising because of the depreciation also should go to P&L. Are you getting my point? Suppose if it is a revaluation gain. Yeah, revaluation gain is routed to OCI. Correct. Now, so now deferred tax liability will come. That is deferred tax expenditure on the gain. That also should be routed through OCI. And if the income or whatever expenditure is directly debited or credited to equity, it is directly debited or credited to equity, then this deferred tax also should go to equity. Correct. So where is it booked? Is it booked in the P&L? Is it booked in the OCI? Is it booked in the equity? Yeah. Then deferred tax also. Deferred tax also it should be booked in the profit and loss statement and OCI. It will be in the equity. First, where it is booked, there only you are supposed to book. Yeah. For this best example is revaluation gain. Yes, it is a revaluation gain. Correct? Or actuarial. Okay, actuarial gain or loss. Actuarial gain or loss. Actuarial gain or loss. Listen carefully. If you see, suppose we have a property, plant and equipment, say that is equal to book value is equal to 1000 rupees, but the fair market value is equal to say 1600 rupees. So that leads to what? That leads to revaluation gain of 600 rupees, revaluation gain. Agree? Yes. So what is the journal entry you pass for this? We will pass say PPE account debit, correct na, to revaluation reserve 600 we will record. This will be presented in the OCI statement. Correct? Right. Now, yes, this is your carrying amount of the asset has gone up by 600 or not. That means you are getting a future economic benefits are going to be more. Reduction you will get nothing from this. Correct? Because you revalued, you will not get any extra depreciation, extra deduction. So then 600 into 30% is assumed that is a taxable thing or not. Deferred tax liability comes up. Correct? Na? Yeah, carrying amount is greater. Deferred tax liability comes. So now what is the journal entry you should pass for deferred tax? Deferred tax ke liye what is the journal entry? You should do revaluation reserve account to debit to deferred tax liability, that is equal to 180. That is 600 into 30% you are supposed to do. 600 into 30%. This is what you are supposed to do. Have you understood my point? This is how. This is what the important point which you need to remember. Revaluation gain correct. Now it will not hit the, this will not hit the profit and loss statement. No, it will not hit profit and loss statement here. Okay, yeah, it will hit deferred tax expense, but it will be routed through OCI. OCI means revaluation reserve only will be coming down. Okay, yeah, so that means in my final presentation, if you see the PPE, correct, now PPE was 1000 plus 600, that is equal to 1600. It will appear like this, correct, but revaluation reserve will be how much, my dear? 600 minus 180, that is equal to 420 here, and DTL is also 420 rupees here. So not 420, 180. Correct. DTL is equal to 180. Got it? This is the way presentation will come. Correct. And in case of OCI, OCI statement mein what will come, my dear? We will say revaluation, correct. Now we will say revaluation gain, inner column may 600, and say deferred tax. Deferred tax is equal to 180 minus, that is equal to 420 will be the outer column. That is under other comprehensive income statement. Other comprehensive income statement, OCI, revaluation gain of 600, because whatever is here, both the numbers will be coming from here only. Understood? Yeah, actual gain or loss also the same way it is going to happen. Okay, it will be hitting the OCI, because which is hitting OCI, there only it will hit. Next step, right? Can we go ahead? Right. Say example, now you must have heard one point called compound financial instruments, my dear. Compound financial instrument, which we will discuss in some time today only. Okay, compound financial instrument means, suppose convertible debenture. It's a compound financial embedded derivative, correct? It is embedded derivative. What is embedded derivative? There is an option inside and there is a debenture also. This is a derivative. This is a derivative. Agree? This is a derivative. Hope you got it. Yeah. So a derivative, now what will happen? Say you have issued the debenture for, you have issued debentures for what number? 1 lakh rupees ko debenture issue kiya. Agree? But what do we do out of this? Out of this, what is the value? Correct. Now, what do you say? Liability. Liability, present value of the liability we will calculate. Present value of the liability will calculate. Say 95,000 rupees present value of liability has come. If 5,000 rupees will be what, my dear? 5,000 rupees will be other equity element. What is this? Other equity element. Okay. What is the journal entry we should record? An initial recognition of convertible debenture, that is equal to cash account debit 1 lakh rupees you collected, correct na? To say example 10% convertible debentures. How much debentures, my dear? 95,000 rupees, that is only the fair value. Then other equity, correct na? Other equity is equal to how much? 5,000 rupees you have noted, correct na? Now listen, other equity means this is an income. What is this? Income, obviously, but it is directly gone to equity, OCI, not OCI. It is directly goes to equity, not OCI. Okay, this won't go to, this will directly to equity. This directly goes to equity. Okay, no, not routed through OCI. Now, understood my point? Now what, where is it income na? So deferred tax has to be computed even on this number also na? It is an income on our own shares. What is this? This is an option of which company shares? Our own shares. Since it is on our own shares, our income on our own shares cannot be routed through profit and loss statement. Correct na? You are dealing with your own share, and gain or loss cannot go to profit and loss statement. It has to go to only other equity. I hope you understand. I issued share, I got profit. कैसे बोल सकता? Your share only, no. So this is a capital transaction. What is it? Capital transaction. A capital transaction cannot be routed through profit and loss or OCA. It has to be directly to the equity. That's why what are you supposed to do? Immediately you should pay. It is an income, correct na? Income hai to tax will be payable. When you get income, are you liable to pay tax or not? Yes. So then what do you say? Other equity account debit to DTL. So that is equal to 1500. That is nothing but 5000 into 30%. You are supposed to record this entry. This is the first journal entry. This is the second journal entry on day 1 of issue of convertible debentures. We should record this. Okay. The basic concept is what? Where is the income or expenditure booked? Income is booked in P&L. Then deferred tax expense also will be booked in P&L under the current tax expenditure, current tax, deferred tax. If the income is gone to OCI, then this also will be going to OCI. If the income is directly booked in the equity, like other equity, this is the only one example. One specific paragraph of the Ind AS 12 talks about this. Not everything talks about. Okay, then it should be transferred to that one only. I hope you understood this point. Right. Chalo. So that is one first important point. Next, my dear, deferred tax liability. If I say deferred tax liability, okay, when I say deferred tax liability, my dear, there are exceptions. What do I say? There are exceptions. Right. Even deferred tax asset also I'll deal it directly. Deferred tax asset, deferred tax liability. Okay. What is the exception here? If I say, okay, listen carefully. Deferred tax asset ka, deferred tax liability ka exceptions. Exceptions means should not create, correct? Exception means what? Should not create deferred tax. Right. First thing is what? Goodwill. Okay. Right. You have to create deferred tax on all the deductible temporary differences. First we'll say that sentence. I will tell that. Okay. Create deferred tax asset on all DTD, deductible temporary differences. Here, what do we say? Create deferred tax liability on all TTD, that is taxable temporary differences may create karo. Except, okay, except, yeah, except. What is the first point? That is the goodwill arising. Okay, that is initial, correct, initial recognition, initial goodwill arising on business combination. When you have purchased any other company, goodwill will come, correct na? On the goodwill, you are not supposed to create, correct na? You are not supposed to create deferred tax asset. Sorry, deferred goodwill is a correct na? The goodwill deferred tax liability. I'm sorry. Goodwill is liability. Goodwill is an asset na. I'll just shift it to this side. Okay na? Right. Initial goodwill is an asset na. New asset is coming. New asset is coming means money will come flow. Goodwill, if I sell, money will come or not. So that is taxable. Taxable. Then if you pay, you are supposed to tax payable. That's why deferred tax liability comes. It is increasing the asset side number. Goodwill is increasing the asset side number or not? On a business combination, whatever excess paid is sitting as an asset only. No, asset is there, but what is that leads to what? You need to create deferred tax liability for the same. But you don't need to create deferred tax liability with respect to initial recognition of goodwill arising from the correct. That's why first day on business combination, when you pass a journal entry, are you getting my point? Will not create any deferred tax asset or deferred tax liability on these items. Got it? Deferred tax liability will not be created. And second point, what I am telling, that is the same thing. That is same for both. Okay, that is same for deferred tax asset also, deferred tax liability also, it is same. What is it? Correct terminology, let me see it from here only. That is better rather than changing the words. Yeah. This is the one. Fine. So deferred tax liability, that initial recognition of goodwill arising from the business combination which we wrote. Correct. Next point is what? The initial recognition of asset or liability on the transaction date which is not arising from the business combination at the time of transaction, it is affecting neither accounting profit nor taxable profit. That is the point. Okay, right. This is again initial recognition. What do I say? Initial recognition. Initial recognition of asset or liability. First thing. First time you are recognizing some asset or liability. Right. First point out of this clause number 1. Okay. It is not arising. It is not arising as part of business combination. Okay, some new asset I am recording not because I bought it in the business combination. Okay, done. And second one is what? It is not creating, what is the word correctly, at the time of transaction it is not affecting, it is neither affecting, it is not affecting, what is it not affecting, my dear? It is not affecting accounting profit or tax profit. It is not affecting accounting profit nor tax profit, taxable profit. In simple words, no, it is not exactly, but in simple words, E point is permanent difference. What is this? Kind of permanent difference. It is a kind of permanent difference. This is same, exactly words will be remaining same. Okay, exactly words will be remaining same. And now one more point has come, one more third bit also has come. What is third bit here? You don't need to write here. In simple words, I can say, earlier what we used to do, with respect to leases, this is an amendment, somewhere 2021, 20, 22, 23, somewhere it is. Okay, with respect to leases, what will come, my dear? You will get ROUA, you will get lease liability. Agree? Correct, na? You will get ROUA, you will get lease liability. Earlier what you used to say, so 1000 rupees is this, assume lease liability is equal to 800, not on the date of creation, after second year, third year, both numbers will not be matching, because ROE will be depreciated in one style and lease liability will be, payment cycle will be different. So it will not match. So what do we do? 200 will be there. On this 200 we will create deferred tax liability, something like that we will create. Some 30% something will apply and create. Are you getting my point? We used to do net off. Lease liability and ROE net off, and we used to do that one. Now what the standard is telling, okay, on ROUA you have to create deferred tax liability, on lease liability you create deferred tax asset. Separately you are supposed to create. Shall we check once what is ROUA, lease liability ka deferred tax, how does it come? Okay, first ROUA is what? Asset. Correct na? Asset. On using this, first thing, yeah, do you get taxable benefits? Yes, by using the leased property will generate the income. Correct. Now by taking this building and rentals, I will be giving the services to the students and I will be making the money out of it. Agree or not? Exactly. So now tell me, my dear, with respect to ROUA, first, what is that? How much amount of deduction? If I keep like here 1000 rupees, I am keeping, here I am keeping 800 rupees. Agree na? Some number randomly I kept it. With respect to this is the carrying amount. Okay, what is the tax base of ROUA? Do you get any depreciation deduction from the income tax department? You will never get depreciation. Correct na? You will never, that depreciation whatever you are charging, that is not allowed as per the income tax department. So that is, what is the deduction available? 0. Correct na? So this is tax base is equal to how much? 0 ne. Correct na? So then temporary difference is equal to how much? 1000. Okay, so this is taxable temporary difference of 1000 with respect to ROUA. Agree? Right. Next, with respect to lease liability. Lease liability, what is the tax base of lease liability? You have to pay how much? How do you calculate? Carrying amount is equal to 800 minus. If I pay 800 rupees, what did I say? If I pay 800 rupees, do I get deduction? Huh? You will get deduction, correct? Na? Right. So that is an expenditure, that is nothing but rental expenditure, you will get the deduction. Okay, what is allowed? Allowed as deduction, that is equal to 800 rupees allowed. What is this? This is the tax base. So tax base is equal to how much, my dear? 800. So 1800 minus 0 is equal to 800. What is this? This is deductible temporary difference. So right, you need to do separately. You need to do separately in the sense, what I mean to say, into 30% you should calculate and say this is equal to deferred tax liability. Here also into 30% and you should say this is a deferred tax asset. You have to show separately. You cannot do it clubbing. Have you understood what I say? You cannot club it. You have to show in the disclosure separately. That is the only point. It is there. I don't know if we there should be a table. Hmm. Taxation, he gave the net impact. Okay, 1 second, let me see. We need to search here. Not happening. Okay, right. If you see, I mean 100% it will be there. I am very sure. But where it is there, that is the, I mean, suddenly when we try to look at, na, it may not appear. That's all. Borrowing. Where is it gone? Just now something. Reconciliation visa, no? Deferred tax as a deferred tax liability. Fine. I'm not getting exactly. So okay, let's not spend too much time on this. Right? We need to give separately what I am trying to tell. What is that separately you mean to say? Lease liability should be under the liability side. This is deferred tax arising from lease liability. This is deferred tax asset. And from the ROUA, this is deferred tax liability. This is the number it will arise. Karke, that both the numbers you are supposed to tell. Okay, na? Right. In addition to that, my dear, they asked once, asked or given in the textbook, I am not very sure. But the reconciliation statement they have asked. That is for the effective rate of tax. What is that? Effective rate of tax. Have you heard of this first? Effective rate of tax. Hmm? What is effective rate of tax? One second. Yeah, what is effective rate of tax by any chance? No chance. Okay, not a problem. Yeah, see, when you say my profit before tax, right? Profit before tax is equal to say 10,000 rupees is there. Okay, next this, then what do you do, my dear? Tax expenditure, you are going to reduce it. A tax expenditure, then under the tax expenditure only current tax will come, deferred tax will come. Do you agree? Correct. So current tax is equal to, and at the same time, sir, what is my rate applicable to my company? Say sir, 25.167 percentage, 22 percentage plus 10% surcharge plus education, says altogether 25.167 number will come. Correct. I would like, for easy purpose के लिए I will take it into 30%. I will convert just for discussion purpose. Okay, so 30% when I take it, okay, but tax calculation will be different. Correct na? Tax mein what will you do? You'll start with PBT, what all disallowed. Correct na? You will say book depreciation you will disallow, tax depreciation you will allow. Correct na? The 43B section, correct na? Whatever, something will be allowed, something will be disallowed. CSR expenditure is there, you will disallow. Any penalties are there, you will disallow. Agree or not? So something that nature, ROUA depreciation is there, you will disallow. Depreciation as per only Income Tax Act will allow. Right? So many other plus or minuses will be there. Then after getting all that, say example, you got 2000 rupees current tax, you got it. Next example, some 200 rupees deferred tax calculation also has come. What has come? 200 rupees. As per your whatever we discussed so far, that we did, we got 200. So how much is the number you got, my dear? 2200 you got. Right. First basic question. What we should ask? Sir, you are getting 10,000 rupees. Correct na? 10,000 rupees into 30% if I apply, how much should come actually? Your tax expenditure should come 3,000. 3,000, which tax expenditure means which expenditure? This is the tax expense. Total tax expenditure. Deferred tax plus current tax should be 3,000 should have been there. Correct. But why it is 2,200? That is equal to 800 rupees is there. Correct na? What is the reason for this 800? What is the reason for this 800? Are you getting my point? That reconciliation is called effective tax rate. What will be the reason for this 800? First reason, just guess and tell. What is the reason for 800? Allowance disallowance के लिए you must have created deferred tax. Suppose 43B is there. Correct na? Provision for warranty you must have disallowed, but you must have disallowed for calculating current tax. But warranty provision you must have created deferred tax. I am not looking at the current tax. I am looking at the total number. It is covered somewhere, na? Either on this or that. That's why I am looking at total. Any other idea? Think and tell. Let it go wrong. What is there? No. You must have made deferred tax for such kind of things. If it is allowed one side, not allowed here, which will be allowed in the future, means pakka you must have made deferred tax for those. Why difference will come? The difference, first reason is what? Permanent differences. Okay, permanent differences ke current tax also you would have not created, deferred tax also would have not created. No, nothing is created. Correct na? So 800 rupees is mostly because of the permanent differences. Agree? Permanent difference 800 क्या है? Suppose example, right? CSR. Simple example CSR. You are all aware of it. Correct na? CSR do you allow in the income tax? No. Correct na? You must have this not calculated for current tax. Do you agree? Right. And will it be allowed in the next year? It will never be allowed. Correct na? It will never be allowed means you must have not created deferred tax also for the CSR. CSR is not asset or liability. It's already charged off. I hope you understood. You must have not created deferred tax also. You must have not created current tax also. Are you getting my point? Yes. So CSR is one of the reason for 800. CSR is one of the reason for 800. Like that, they correct na. But it is not depreciation. Sir, depreciation. Okay, tax depreciation is equal to 1000 rupees, sir. Accounting depreciation is equal to 1400 rupees, sir. Correct, sir. But for the difference of 400 rupees, correct. Now you must have already created deferred tax, no? In my total 2200 may have I considered or not considered. So that's why the difference reason is not only the permanent differences, or it can be some more things may be possible. What is some more things possible? Suppose you are doing the correct na example, rate difference can be rate difference. Rate difference. What is rate difference? Suppose capital gain, very good, correct na? Capital gains are there in my profit and loss, correct na? Example, 10,000 rupees is there, 10,000 rupees. So into directly you applied 30% करके apply कर दिया. But for my, if it is a long term capital gain is sitting here, maybe only 12.5% is taxable. Hope you understood. But you have taken directly 30%. That may be one of the reason for differences. I hope you understand. Right. So such kind of differences will be there. Just now I found here, I don't know how it went off. Take second. Deferred benefit plan revenue. Here only, this side only I could see that. This is components of deferred tax. Other equity. Idi. Nodi. See this. This is Reliance company ka tax expense for the year can be reconciled to the accounting profit for the year. This is mandatory presentation. Disclosure required. Profit before tax. If you see profit and loss statement, you will get the same number, 46,128 crores. Okay, applicable tax rate. Yes, for them also 25.168% they are applying. Agree na? Nothing wrong. Computed tax expenditure. It should have been how much? 46,000 into 25% would have come to 11,000 rupees would have come. Okay na? But actually expense, correct na? Right. Here you see tax expense recognized in the statement of profit and loss. But actually if they see, if you see the profit and loss mein tax expense means what? That is current tax plus deferred tax. Put together it will come to 10,866 it will come. Hello, understood? Okay, but it is supposed to be how much? 11,609. Why that is? Why there is a difference of E number difference is there? That is because of these reasons. Okay, that is because of these reasons. Okay, what is this? Expenses disallowed means permanently disallowed. It will never be allowed once again. Getting my point? Like a permanent difference. Additional allowance or deductions. Okay, additional allowance deduction means 100 rupees when you spend, right? I don't know right now which law, which section, which talk about, I don't know exactly. Earlier, long ago, I mean, research and development, 100 rupees, if you spend 125% will be allowed, or 150% used to be allowed. That is keep on changing. Now it is only 100% deduction. But this company is into oil, this company is into different sectors. I don't know. That is what is he saying? Additional allowance or additional deduction. Correct. They are into different sectors of maybe telecom sector, not because of the research and development, what I am trying to tell. They may be getting some ATIA, ATIB, I don't know all those things. I hope you understood. Right. So that will not be there in, for that you must have not created deferred tax also, you must have not created current tax also. Right. That is one reason. Next, incremental deferred tax liability on account of property, plant and equipment and intangible, okay, intangible asset. Yeah, okay. Impact, I don't know exactly, we not catch. Impact on the accounting change in the tax rate. Tax rate, maybe here you must have applied one rate. Here difference in the tax rate, I told na. There you have applied 25%, here only 12.5% is applicable. And because of that difference also, this difference will come. Incremental deferred tax on account of financial assets and other items, right? Unless until you go deeper, no, what item exactly, you will not catch it. Okay, fine. For the company, what we do, we will be able to tell better why it is, what is the differences. But you understood na? You have to reconcile it to 25.167% ko you are supposed to reconcile it. That is the important thing. Hope you understood, right? So these are all the some of the important. And again, one more point is there. Deferred tax asset. Can we create deferred tax asset on the what is that? Tax losses, my dear? Tax losses or unabsorbed depreciation. Tax losses or unabsorbed depreciation, can we create? We can create, right? Actually, as per accounting standard 22, it says virtual certainty supported by convincing evidence. AS 22 says virtual certainty. Okay, here it won't tell that way. It will tell reasonable assurance. Okay, reasonable certainty. That's it. What is required, my dear? Reasonable certainty. What is reasonable certainty? Reasonable certainty is nothing but estimations, my dear. Estimations or projections. Yeah, it is not that strong like virtual certainty. It is not that strong like virtual certainty. Are you getting my point? Okay, reasonable certainty in the sense, first of all, one thing everybody has to keep it in mind. Suppose I made a loss for last two times, or in last 2 years or 3 years, I am continuously making the losses. If you say I am going to get profit in the next year, will anybody believe so easily? Nobody will believe. Correct. Unless until you prove it, it is very difficult. So since you got already losses in the last year, current year, or something like that, till you get the profits, don't create. That is general suggestion. Generally, nobody creates the deferred tax asset on the tax losses or unabsorbed depreciation, because you made losses, that itself is an evidence that something is wrong. Unless until you prove that no, we are again back, we are able to get the profits, whatever the accumulated losses are there, that I am going to utilize it in the future. If you can prove it, yes, you can go ahead it. Hope you understood. Otherwise, don't create the deferred tax asset on this. But actually the language of the standard is light compared to accounting standard 22. Light in the sense, reasonable certainty that there will be future taxable income, okay, with which I can offset these tax losses or unabsorbed depreciation. Under that circumstance, yes, you please create it. Otherwise, not required. Hope you understood. Right. So that is one of the important point. Next, ESOP ka bolo. ESOP ka, what do you do? If you have ESOP, actually on ESOP, no, deferred taxes should not come. Why deferred tax only should not come? Right? Reason is, as per the Karnataka High Court judgment, and it is followed by all the people actually. As per the Karnataka High Court judgment, what does it says? Whatever the ESOP expenditure is there, that you allow it as an expenditure in the income tax itself. Income tax also allows the same thing. You understood my point? Right. So when income tax is allowing the same, then why the different? There is no difference, no. I am also charging the same thing to P&L. Agree? And income tax also is charging the same thing to P&L. And that is not a liability or asset in the balance sheet. There is a reserve directly sitting in the balance sheet. Correct, na? Right. I told yesterday first only, it is only on the assets and liability, not on the equity element. Correct, na? So that's all. So ESOP, actually there should not be any difference. There should not be any difference. No deferred tax should be there. But if it is something like, if the question asks differently specifically, you will not get the deduction now. You will get the deduction at later point of time. When you actually issue the share to the person, that day you will get the deduction karke. If the question says, then obviously there is a timing difference or temporary difference is there. Are you getting my point? Under that circumstance, deferred tax will arise. Otherwise, it will not come. Have you understood my point? ESOP means how many years? Suppose example 3 years. In accounts may what will happen? You will be charging depreciation. I mean, you will be employee benefit expenditure will be debited all the 3 years or not? Correct. Suppose if the tax will allow you to only in the last year. Tax will allow you only in the last year. Correct. Now here nothing allowed. Then deferred tax will arise. Hello, understood? You will create it now, and you will create it now. You will be reversing in the last year. Have you understood? Correct, na? Right. Suppose if they allow in the current year also, they allow every year. If they allow, where is the deferred tax? Why is the deferred tax? Correct. But whether they are allowing every year, practically what are we doing? We are allowing it in the very year, because department is allowing. But your examination question can be different. What I am trying to tell, examination can tell, correct, na, as per the law this is like this, correct. They can tell something just to create a question. He may ask something. Then deferred tax will be created here. It is an expenditure, so deferred tax asset it will become. Correct, na? So deferred tax asset will become deferred tax asset. It will become. It will be reversal. Reversal of deferred tax is going to happen. Done, right? So shall we? Correct. See, when you under that circumstance, first question is whether the expenditure is allowed or not. You will make a provision for ESOP karke, that is nothing but cash settled ESOP. What is it? If it is a cash settled ESOP, it will become a liability to you. Right. What is your journal entry, my dear? Journal entry will be employee benefit, correct na? EBE. Yes, EBE, employee benefit expenses account, debit to liability. ESOP liability, something you will create it. Correct? Now the question is it allowed or not? First you tell me. Then accordingly I will tell. Correct. Hold on. It is allowed in the future. Yeah, that is your answer. Accordingly, I will answer. Accordingly, I will give the solution to it. So now liability, what is the first carrying amount is equal to XX number. This is just a carrying amount. First, for the calculation of tax base, it is not advance income. So what do I do? CA, carrying amount, same number I should take it. Correct. Otherwise, I will keep the numbers, some number I will keep it, so that easy understanding. This is 1000. This is 1000. Right. What is allowed on payment, my dear? What is allowed on payment? In the future, you said you will allow, na? Correct. So, yes, after 3 years or 4 years or whatever, 1000 will be allowed to you. Then what is this? This is called tax base. Correct. Na? So, then what is the tax base here? 0. So, do you get a temporary difference of 1000? Yes. So, into tax rate, something you apply, deferred tax asset will come. Correct. Na? Why? Current carrying amount is greater than the liability. This is a liability. Carrying amount is greater than the tax base. So, deferred tax asset will come. If it is asset situation, liability will come. Liability situation, my deferred tax asset will come. Is that clear? It all depends upon what answer you will give. Accordingly, if you go, fine. Sometimes what happens, you will get 5 probabilities you will keep, and you will try to fix whatever you want. Then you just go by that way. It will work. Okay, right. Any other question you have in this? Deferred tax is always non-current. This is exception to current non-current definition. First, deferred tax can never be current. Deferred tax asset, deferred tax liability. Right? I think that answers your question. That's what I told you. Na? First thing, you should be knowing little bit about local taxes. Correct. Na? If you don't know, suppose you don't know, I never worked on income tax purpose, then it will become difficult for you. Correct. Na? Say simple example, I will say provision for warranty. Provision for warranty. Income tax, okay. What is the carrying amount? Carrying amount is equal to 1000. Correct. Next, I am calculating here. Carrying amount is how much? 1000. Now the question is, what is the question here? When you today, is it allowed as per the Income Tax Act? It is a provision, so it is not allowed. Provision not allowed. But tomorrow when you make a payment, is it allowed or not? That day it is allowed. How much is it allowed? 1000 rupees allowed. Information you should be knowing in the income tax first. Is it allowed or not allowed? Hope you understand. So then under that circumstance, then now you will say tax base is equal to 0. Then there is a temporary difference of 1000. All items of profit and loss, all items of balance sheet, you should be knowing accounting, you should be knowing tax provisions related to your company at least. Okay, then you will be able to calculate deferred tax in lesser time. It will happen faster. But if you know the relevant provisions. Suppose in case of NBFC, okay, provision for the what do you call on the some percentage amount, I'm not very sure, I forgot the percentages, tax I'll not show that much interest. Okay, on the ECL portion may, I mean on the what do you call, provision for NPAs, provision on NPAs, some portion will be allowed. Some portion is not 100% of the NPA provision is allowed. Some portion will be allowed as for the tax purpose. Okay, because it is a bank and NBFC ko our rule is applicable, not for every company ka. I hope you understood. Then it is allowed, na? But first you should be aware of that section. Is it applicable to your company? That's what I am telling. Your company sections you should be knowing. If you don't know, it is difficult. Okay, right. If you know na, doing this reconciliation statement, first adoption mein reconciliation will be little difficult. Subsequently you will be able to do it faster. We'll know once you get the grip now. What is about the company? Why this is not getting taxed? Why that is getting taxed? Correct na? When you go by all assets of the balance sheet, ka all assets pura will. I used to have a format. I'll have a format saying that balance sheet mein balance sheet assets karke will write everything. I mean I will write all the assets here. My total should tally first with the balance sheet link hona. Okay. Now I will start putting the tax base. Then I will say the difference. Okay. If difference is positive or negative, we will obviously will get it. Correct. Accordingly, deferred tax asset, deferred tax liability, yeah. Correct. Na? We'll write 25% on the top, link it. Then exactly numbers will flow. First time, one time you need to work on the tax base ka thoda. First time you need to work. Subsequently, you don't need to work. It will work perfectly. It will automatically, it will go on. Okay, maybe. Yes, deferred tax is always key point. I agree. Last minute also some small changes will happen. Correct. Na? Last minute may also you need to look back. Yeah. Okay, but that will be so small differences. Cool. Say if you apply brain, no, it will work easily. Not that difficult. Done. Shall we go ahead? Right. Shall we go to SBP, share-based payments, Ind AS 102. Any specific none you wanted in the deferred tax by chance? Fine, no? Right. Overall, conceptually we have covered. Nothing, no major concept, so nothing is left. Yeah. SBP, share-based payments. Yeah. Share-based payments. Done. So first of all, the payment should be based on the share value. Correct now. Payments are based on shares or options of the company or the group company. It can be based on your company or it may be based on the group company. Okay, right. Yes, E standard totally, as you know, there are totally the standard itself they have divided into 4 topics. Okay, topic number 1, equity settled, correct, equity settled SBP. Second is cash settled SBP. Third is what? Third is an option left, correct na? Cash alternative. Cash alternative, that is the optional to both the parties, both or anyone is correct. Optional to anyone. Optional to anyone. Okay, then the fourth one is group share based payments. Group share based payments. Okay, right. So the point here is very simple. Fine. Group share based payment, fine, we'll see. Right. Group share based payment also they have asked I think 2 times. A small question, 4 marks or 5 marks question has been asked. Okay, right. Most of the time, na, out of these two only the question is coming. Either equity settled share based payments or cash settled share based payment. Cash settled share based payment only, what do we call? SAR we call, SAR. Correct na? Share appreciation rights. Okay, appreciation rights, share appreciation rights, SAR. That is nothing but cash settled SBP. Okay na? Right. From here na, the concept is there, but the questions I don't think so. They have not asked even one time also from this area. Only group also I told, only one time there was a small question was asked, 4 marks, 5 marks, one time or 2 times maximum, max to maximum. I'll discuss that separately. Okay, I don't want to handle this because considering the importance of it. Fine. So equity settled share based payments. Tell me, my dear, equity settled. Yeah, equity settled share based payments. Means what is it going to happen? We are going to give the shares, right? Or we'll give option. Option will end of the day it will entitle the share to the holder. Correct, na? Options will give what? Shares only to the holders, not anything else. Agree, na? Right. So options will give the right. Now, which date rates we should consider? First of all, what is the method you should follow, my dear? We have to fair value. First point, remember that. What is that? We have to fair value. Fair value. Fair value the options. On which date? On the grant date. We have to fair value the options on the grant date, mandatorily. Sir, can we follow intrinsic value method? Intrinsic value method karke, there is one method, but there is a rare circumstance which is not allowed. Rarely allowed. Intrinsic, you write it and cross it. Intrinsic value method. Okay, right. I can say standard is not preferring that. If you cannot measure the fair market value of, that is a very rarest circumstance. Fine. What are you doing? Fair value of the option. Correct. Who will do? Independent valuer will do. Yes. In your AFM, you must have heard what is that? Binomial model, Black-Scholes model. Correct, na? All those models they will apply. Any one model they will apply. They will determine what is the fair value of the option. They will tell you a number you should go with. Okay, right. Next, fair value. Okay, fine. Here fair on the date of grant I told you, but in general that is okay, right. Now what is the entry? If it is equity settled SBP, what is the journal entry? How do you record? What is the entry you record basically? Very basic thing, Sorry? Expenses account debit. It may be employee benefit expenditure if it is given to employee. Correct, na? Employee benefit expenditure is one. Fine. EBE, employee benefit expense account debit. Or you must have received some goods also from them, not from the employees, from other than employee. Standard is applicable only to employee, na? No, share based payment. Payment may be given to anybody. I have got your some technology. I am giving my company shares. Yes, you have to come to my standard only. I hope you understand. I purchased your fixed asset. I am giving my shares to you. Yes, you have to come to my standard only. Got it? Right. So if there is any goods or services account debit to ESOP reserve, or what is it called? Sorry? Yes. Okay, SBP reserve, share based payment reserve. Fine, whatever, some name you keep it, not a problem. Right? SB, share based payment reserve. It is a reserve basically. Correct, na? Right. First point. Got it? Next, listen carefully. First question is what? What number I should take it here, my dear? What number I should take it? How do you determine? Yeah, fair value is correct, eh? Right. First point, first preference should be, do you know the fair value of the goods or services received? Not the share option. If you know it, then you must go by that only. Okay, what is that? Suppose I purchased a fixed asset from you. What is the value of it? I know it. Correct now. I should give value to the asset what I got, not share I gave. Have you got my point? First preference should go where? Yes, first preference should be the fair market value of the goods or services received. Point. Okay, na? Right. Second, if not available, yeah, I'm not able to determine. Example, in case of employee services. Okay, in case of employee services, then what are you supposed to do? Then you don't have H option. Then the fair market value of option you are supposed to go with. Options or shares should be measured. Have you understood the point? Right? What is that I told you, my dear? When there is goods or service, first priority. Correct. Now, suppose I purchased a technology, I purchased some fixed asset, I purchased something. First fair value of those things only supposed to be taken, not anything else. Hope you got it right. It is always like this. If fair market value of options are correct, if the services are I received, but I don't know what is the worth of it, I'm not able to measure it. Assume a situation like employee benefit expenses. Best example. Employees are working. They are working normally also. How much extra they are working? How do I know? Nobody knows. Correct now. What is the benefit if they continue with you for 3 years? What is the benefit you are going to derive? That also I don't know. Under that circumstance, fair value of the options is what we will do it. Correct now? Next. Fine. One more point is what? As you are aware, vesting period, vesting conditions. Correct now? Vesting conditions. Right. Vesting conditions of vesting conditions. What are the types of vesting conditions you will have? First one is service condition. Correct now? Service. So that is nothing but how many years you are supposed to, correct now? Some 3 years I am supposed to work. That is first kind of condition. Second kind of condition is what? Performance conditions. Correct na? Performance conditions. Yes. What is performance condition, my dear? Performance conditions again further divided into two. Correct. Now one is what? Market based. Correct. And this is non-market. Agree? What is non-market? Non-market PAT you should achieve. Correct na? ROI you are supposed to achieve. Something, correct na? Research and development you are supposed to complete. Yes, such kind of conditions are this. Market based means what, my dear? You have to, your share price should be the external basically. Share price should reach this number. Share price should reach this number, correct na? Yeah, something like this. This is performance conditions. Agreed? Right. Listen, why is that we are talking about it? These two things also are interlinked. Agree na? Interlinked. Why interlinked, my dear? When you are achieving the PAT, you must be employee also, na, first of all. You have to be there and you have to achieve the correct na? Performance you have to achieve. PAT should be there means I leave, sir. Once after achieved, then I will come and collect the shares. It's not possible. You have to be there and you have to achieve the PAT or you have to achieve the R&D and etc. Then you will get the number of shares or options. Agree na? Right. Now question. If it is a non-market, okay. If it is a non-market, my dear, any idea between these two differences in valuation or anything? There is only one point is there. A point correctly if you understand, no? Balance all will be remaining same. Directly I can go for modification of the ESOP. I can explain. Okay. Modification again, three types of modifications will happen. What will have cancellation is one more thing we'll discuss. Then we can go to cash settled SBP. We can just directly get in. Right. Any idea non-market conditions, market conditions may anything? Correct. Market conditions are not within the control of the entity. Then this one, non-market also, like, okay, it is depends upon the performance of the employee, performance of some external factors, some internal factors will be there. In calculation of ESOP, anything specific is there? I am asking. Which? Yeah. Listen, when the person has done the fair valuation, okay, from here to here, what is the difference? Very simple. So, if I say fair market value of option is equal to 20 rupees, okay, into number of options. Number of options, say 1000 options are there. Okay, na? Right. So, right. And how many number of years? Number of years. Number of years, say we said 4 years. Right. We must have given the already information of number of years to the, to whom? To the valuer already. Correct. Now, within 4 years, if it is achievable or not achievable, accordingly, what is the fluctuation karke, he will calculate and tell. Now, listen, and the fair market value of the share target price. Okay, target price is equal to say 150 rupees. Example, you have to achieve, then you will be eligible to get it. Are you getting my point? Now, in this case, what will happen? Say year 1, year 2, okay, year 3, year 4. Correct, na? Right. Listen carefully. In case of first year, example, sir, it was maybe Y0 it was 100 rupees. It went to 110 rupees, sir. Oh, it is growing. Correct, na? Possible. Right. It went to 135 rupees. Okay. It went to 80 rupees. You understood my point? It went to 80. Maybe last day it may reach 150 or 160. It may reach. I getting my point? Right. Here, fluctuation, correct. Now, this is 100, it went up, further up, it went down, correct. It went up further, correct. This you don't need to consider. You don't need to have your judgment. It went down, so let's not, it is not possible to achieve. No, whether it is possible or not possible, you need to book the expenditure. This is the first important point. If it is a market based performance condition, have you understood correctly? In case of market based condition, correct, now we don't need to, we don't need to consider fluctuations and etc. Simple. Whether it will be whether market may target will be achievable or not achievable. Correct, na? Target achievable or not. That is not our job. Why means? Why, sir? When I say fair value of the option, somebody has already calculated in 20 when he kept, na? He must have taken into all these things into the consideration, because volatility of the share price also he will consider when he is following Black-Scholes model, na? He will consider all that. That's why you should not be bothered. And what is the second situation? Mein non-market performance conditions mein what will happen, my dear? Correct. What is the performance? Yeah, we told, like, so say example, you have to reach PAT of 150 CR, you have to reach PAT. Okay, first year, in 3 years mein you are supposed to reach. First year it reached 100, second year it went to down to 80, market is down. Now my management here, management judgment is involved. What management will tell? Most probably not possible, yeah, not possible to achieve, so let's reverse it. Are you getting my point? They can reverse it. Suppose third year may they achieved 150, then entirely we will book once again. Here judgment will be involved, here judgment will not be involved. That is the first important point where you may do an error. I hope you have that small clarity. Okay, right. If it is a non-market performance condition, if the management is of the opinion that target will not be achieved, whatever is done, it will be reversed. Right. Next, one more point. This Mostly you will tell answer correctly, but still I'll ask. Okay, right. Try to answer me. Say, okay, vesting period is equal to 3 years. Vesting period is how much? 3 years. Okay, non-vesting period also will be there. Correct. That is exercise period we can call. What is it called? Exercise period. Exercise period is equal to 6 months. Means once it is vested also, 6 months time will be given. So that you can arrange your fund. Are you getting my point? Yeah. So one question I'm asking you, answer. So suppose a fair market value of option is equal to, fair market value of option is equal to 40 rupees. Or 40 rupees or 400 rupees, so we'll take it. Okay, Mr. X is an employee of the company. Okay, he is getting 100 options. And there is an exercise price. It is not 1 rupee or 2 rupee. Exercise price is equal to say 40 rupees you are supposed to pay. How much you should pay? 40 rupees you should. Exercise price is this, fair value of option is this. Now, what is the employee benefit expenditure? So, what do? Total expenses for all the years. What into what minus what, something. How do you calculate? 400 minus 40 into 100. Correct, na? Yes or no? Right, perfectly wrong. Only 400. Okay, you have to apply 400 into 100. This exercise price also you must have already taken, you will be taking into valuation after doing that. Okay, so we should not reduce. This is exercise price reduction where you do intrinsic value method, we will do reduction. This is fair value of the option. Note down. Okay, note down. This you should not reduce exercise price when you are measuring at fair value. When you are measuring at fair value, you should not reduce that number. It's good I asked. Shall we go ahead? Correct, na? Okay. So this is one simple question. I mean, we know it. Somebody was asking a question in some NBFC. I was taking care of it just 1 month before. Okay, right. So there, the fair value of the option is equal to say 2,500 rupees. Okay, exercise price is equal to 3,200 rupees. As per you, it will be negative, no? Correct, na? So that auditor, that company auditor, how it is possible? Karke he was asking. It is not something wrong is there. No, that thing wrong, sir. They have already taken care of 3,200. Over and above that, fair value is what your loss. Okay, so 2,500 into number of options and period may you are supposed to allocate it. 3,200 you are not supposed to consider if you are going by fair value method. You are going by anyhow fair value method. So our numbers are irrelevant to you. Why I remember means obviously some discussion happened. Correct. Discussion happened. They were telling no, there's something wrong, nothing wrong, my dear. Whatever happened is all correct. But okay, fine. Some error happens. Everybody need not know everything at same time. Correct. Sometimes generally sometimes our general knowledge will work. Maybe we don't know how the fair valuation done or something. Correct. That is very much fair enough. Fine. Right. Where are we? Right. As I told, right. Next, this point I wanted to explain one more important concept. Suppose vesting period is equal to 3 years. Okay, na? First year, second year, third year, right? And exercise period is equal to 6 months. I was about to start and between this clicked. So that's why I went to that. Fine. So 1, 2, 3. Listen carefully. Second year you felt non-market condition. What did I say? Non-market condition. So first you must have booked employee benefit expense account debit to reserve. Karke you must have reserve. Correct na? 100 you booked. Correct? Got it? Right. But you felt like not possible karke you felt. It is not possible. What are you supposed to do? You will reverse. Correct na? What do you reverse? Reserve account debit to employee benefit expenses karke 100 you will reverse. Maybe next year it is achieved. Possible to achieve. Correct. Now, you thought something that need not happen, fact exactly. It may change. That time entire 300 will be 300 for 3 years. Correct. Now, it already netted off. Net off ho gaya. So entire 300 I am booking it into the third year. Is it clear or not? Right. Here the question, first important point, when you are reversing during the vesting period. Kya bola? Reversing vesting, I mean you are reversal during the vesting. Correct na? Reversal during vesting period. During vesting period, you can you can credit the expenditure P&L. It is correct. What have you done? Employee benefit expenses. Correct na? Employee benefit expenses करके कर दिया. Hello, correct? Yes. So once it is vested, it is already vested. So now what is that? Your SBB reserve, SBBPR. Okay na? SBPR is equal to how much? 300 rupees is there. Agreed? Now how many people ka options? Number of options is equal to how much, sir? Number of options is equal to 1000 options are there. Some number, just some random number I kept it. Correct na? But out of 1000 options, only 800 people have exercised. Correct. 200 people ka lapse because 6 months time de diya. Even though they worked for 3 years, but they don't want to purchase the options. What reasons and all irrelevant. Okay na? Are you getting my point? Yes. Now what should I do? 800 related ka will issue the shares. Correct na? SBPR account debit. Correct. To equity share capital. To security premium. This is related to 800 shares. Agree? But this I am supposed to do 1000 shares ko karna padega. Because SBPR over. Now to what? To is it employee benefit expenditure? Reversal kar raha hai na. 200 people have rejected it. I don't want it. But they have not said I don't want it during the vesting time. After the vesting time, these people told. Agree? Now what should I do? I should credit what? Employee benefit expenditure. Retained earnings. Excellent. Not this. This is retained earnings. No, you should not debit the P&L. It should be, right, ESOP. That what is that? SOCIE, statement of changes in equity may adjustment should take place. Have you understood? If the reversal, if not exercised after the vesting time, it is not to expenditure. It should be credit to the retained earnings. This is important point to be noted. Practically also people, I mean generally that is a mistake which happens, no? First we need to, being an auditor or whatever it is, you need to check. Right. Once after this, let me go to modification. Modifications are how many types? Modification 3 types. Okay, right. I'll do it from directly from here only. Fine. That is the best part. Otherwise, you need to document so much data. Yeah. These are the modifications related, my dear. Hello. What is changing? Changing in the fair value of the equity instrument. Right. So changing the fair value means exercise price is going to be fair. I mean, exercise price is going to be changed. Simple. First, modification number one. Modification number one. First rule as per the standard you need to remember. Modification, even though we go and modify to the existing agreement, but accounting will happen in such a way, it is an addendum karke it will happen. I hope you understood what I said. Kya bola? I repeat karo. Even though we go to the same paper and we'll go and change it, but the accounting will happen. No, old agreement, old account will continue irrespective of your modification. Correct na? New agreement, I mean a change, 100 rupees I made 60 rupees, 100 rupees I made 120 rupees something. Our change will be accounted as a separate one. This you keep it in mind. Then your mind may problems will be out. Hope you understood. What did I say? First thing what I said. Modification is a separate agreement. Impact will consider, will not consider, will discuss. Right. Next, point number 2. Very important point. If it is unfavorable to the employee, if it is favorable to the employee, not from the company angle, if it is favorable to the employee, will take accounting. If it is unfavorable to the employee means, suppose earlier I told exercise price is equal to 100 rupees I kept. Correct now it is going to be changed. Change can be plus change, minus change, both can change, includes both. If I say exercise price is equal to, I will tell to you employees 50 rupees only you need to pay. Is it favorable or unfavorable to you? Favorable. You are paying lesser and you are getting the share. Same share se same thing. Correct? Right. If it is unfavorable, I will say no. Now shares value has gone up. You people should pay 160. It is unfavorable. Unfavorable as per the standard opinion, it will never happen. Because end of the day, original agreement will continue, no? Unfavorable also amendment ko somebody has to sign, na? Agreement is not one-sided, no? Agreement means both the parties, I also should sign, this guy also should sign. But when it is unfavorable to employee, why employee will sign? Employee will say, it is not one-sided, it is not your plan and as per your wish you will do. I hope you got my point. Exactly. So this will not be accepted by the employee and that will not take place actually. That will not take place. I hope you understood. Right. That's why what the standard says, if it is unfavorable to the employee, forget that there is such agreement. And original agreement always continues. Original agreement prakara, normal, whatever you are supposed to charge, you charge it off. Clear? Right. Now come to the point. Exercise price is, what is exercise price happening, my dear? Decreasing. Exercise price earlier I asked you to pay how much? 100. Now I am asking you to pay how much? 50. Correct? Now what should I do? How should the accounting be done here? Simple. Whatever first initial expenditure, initially based on the 100 rupees, whatever, based on originally on the date of grant, you must have decided the fair value of the option. Option would have been charged to over the vesting period of say 3 years. Are you getting my point? Initially we said 30 rupees is the fair market value of the option. Initial. Yeah, vesting period is equal to 3 years. Then what do you do? First year, second year, third year, E10, will be booking it. Do you agree? Right. Now, in between, E30 rupees is based on what? E30 rupees is based on exercise price is 100. Correct. Now, amendment has happened. Amendment may what is it happen, my dear? Exercise price is equal to 50. Correct? You did it. Now, what should I do? You have to calculate incremental fair value. What is that? Incremental fair value. Are you getting my point? What is incremental fair value? This is incremental. Incremental means additional. Additional means in addition to 30 rupees. Correct? Not 30 rupees ko impact nahi hota. 10 will continue all the time. It will never be changed. Have you understood? Sir, amendment, when it is it happened? In the middle of second year it is happened. When is it happened? On 30th 9 second year it is happened. Are you following me? Right. Now follow me correctly. Incremental fair value means what, sir? What is incremental fair value? Incremental fair value means, okay, original fair value, when did you do it? E 30 rupees at the Y0 you have done, agree? Yeah? On the granted date you have done. But considering which number? 100 rupees as the exercise price. Now, today on 30th 9, correct na, 30th 9, yes, considering as 100 rupees, but on 30th 9, okay, considering as the fair value as 39 rupees, once again you will do, you will not consider E 30 rupees number, you will not consider. Old terms and conditions, on the date of modification, what is the fair value? Have you understood? Same old terms and condition, if I give it to valuer today on 30th 9 second year, tell me what is the number will come. Some X number will come. Agree? Right. Now this is old terms and conditions. Now you give to new terms and condition. What is new terms and condition? 50 rupees wala terms and conditions you give it. Are you getting my point? Right. Some another number will come. Two numbers he is supposed to determine. E difference is what? Incremental. E difference is what? Incremental fair value. E number whatever comes. Say example, this is become 25. Okay. And new terms and conditions is equal to 45. Then 20 rupees additional incremental value has come. Agree na? E incremental value should be charged to P&L from which date? From the date of modification to till the end of vesting period. Means what do you do? If 20 rupees extra is there, na, E 20 rupees should be done in 18 months. How 18 months? You are in the middle of the second year. Correct na? E 6 months plus next 1 year. Total 18 months you are supposed to charge it. Not next year onwards. From the date of modification you are supposed to charge. Right. Here look at what is incremental fair value. It's given here. Carefully read it. Fair value of the repriced or modified instrument on the date of modification, that is 45. Correct. New terms and conditions minus fair value of the original equity instrument on the date of modification with the old exercise price, that is what old terms and conditions but dated 30th 9. Both will be measured, remeasured once again. First one already measured 1.5 years before. It will be remeasured. When you remeasure, it has come to 25 rupees. Considering old exercise price. Correct? Right. Now again, new exercise price also 30th 9. 30th 9. Both the things will be measured on 30th 9. Our difference 20 will be amortized to the from the date of modification to the vesting period. But basic thing, if you don't want to be confused or something, E10 journal entry separately you write it. Additionally, you write, correct na, E20 rupees ko kya karna? Divided by 18 months, correct na, into 6 months in the first year, 12 months in the next year. Agree na? That one more journal entry you write it separately, then your problem will be solved. This is first important modification, right? Next important modification. Any question on this? Yeah, quick. Yeah. So second modification, second kind of modification is change in the number of equity instruments, my dear. What is change in number of equity instruments? Old options, number of options I gave. Very simple, amma. Okay. Old, how much I told you? Arre, per head I will give you 100 options. करके बोल दिया. Now I am telling what new number of new I am telling, बस I will give you 250 options दे देंगे. Is it favorable or unfavorable to you? Favorable. More options I am giving means more benefit is coming. Unfavorable is the same treatment, as if the such transaction only does not happen or cancellation करके will treat it. Okay. Forget about that unfavorable wala. They will never ask you in the exam also. Okay. In case. Now in this case what will happen? Are you giving additionally 150 shares? Yes or no? Correct. Which date you are giving? That is second year, 30th September you are asking. Correct na? Why should I, whatever initial number is what? Initial number will continue as usual. Irrespective of modification, initial charge is supposed to happen. Second thing is what is happening? 150 I am giving, correct na? Now 150 ka separately fair value compute it as it is separate new grant, correct? Treat 150 as a separate grant. Fair market value of the option you determine for this, correct? And your vesting period is going to be 1.5 years, vesting period will be there, correct na? Charge of normal, that's all. There is no separate accounting, nothing is required. Okay, that's all, very simple, right? Recognize the additional cost over the remaining vesting period prospectively, correct na? This will be, yes, you have to determine, it will be treated as a separate grant, a new grant for 150. The old grant will continue, new grant is for a short period of 18 months, that's all. I hope you understood. Situation number 3. What is situation number 3? Any other beneficial, this is like etc category, okay? Yeah, any other beneficial. You see here, in most of the circumstances what will happen, okay, right, incremental benefit only will come. What will come? Increment. What is additional? Any other benefit means, earlier I told, अरे boss, you people should target 150 crore rupees of PAT. That is your non-market performance condition. Correct? Right. Now I am telling, I think it is very difficult for you people to achieve. Now you do achieve only 120 crore rupees PAT you achieve, where I will give you the shares. Agreed? Or earlier I must have told exercise period you are supposed to, correct, vesting period is equal to 4 years करके मैं बोला. Now I am telling exercise period, you don't need to continue to be there for 4 years, you do it for 3 years. Hello, understood? Right. Everything in the same fashion, my dear. Okay. Incremental fair market value you are supposed to determine, and whatever I spoke about on the top, no, same number is going to happen. Okay. Right. Next small concept is cancellation. Kya bola? Cancellation. This is something different in accounting, but okay, we have to follow that. Yeah. Cancellation. Yeah. When you do cancellation of any share based payment, what will happen? They never asked a question for this. That's why you don't need to spend too much time on this. Very simple, nothing major also. Very simple. Cancellation means what? Correct na? I will stop. I will not give you shares. Nothing. Agreement is cancelled. Correct na? Generally, okay. Say example, first year, second year, third year. Total fair value of the option. Correct na? Total fair value of the option is equal to 30 rupees. Okay, per annum, what is that you will charge, my dear? 10 rupees, 10 rupees, 10 rupees you will charge. Do you agree? Correct, na? Right. Into number of employees and etc. calculation, you are good at it. That is not a concept to learn. Done. Now the question. What is the question here? Now you are cancelling. When are you cancelling? In the second year only, before reaching 31st March only, on 30th 9 you have cancelled. Means you booked only 10 rupees so far. First thing, when you cancel, now what are you supposed to do? You have to book this 10 plus 10. The 20 rupees will be booked in the immediately you are supposed to book. Immediately you are supposed to book for 20 rupees. 10 is already booked. That accelerated charge, extra charge 20 which is going to be done next year. Sir, cancelled you are supposed to book still. Yes, that is the excess booking will happen now. Right. One question, common sense question will be there, my dear. Observe you also. See, I gave you a promise. What is the promise I told? You be with me for 2 years or 3 years or 4 years, then I will give you this many number of shares. Say 4 years I told. At the end of the third year I will tell, sorry, bye bye. Tell me, is it going to impact my goodwill? Yes or no? Yes, exactly. Why? The same employer, if he tells it to the other employees or next people, will they listen this? Will they take it seriously? Nobody will take it seriously. This guy made me bakra. I did not leave the company even though I got a good offer, because I am going to get number of shares, good amount of money I am going to get. Correct na? In another 1 year time. That's why I stayed back. Right? So that's going to hit big and bad. That's why nobody will cancel just like that. Okay, nobody will cancel just like that. What do? They will compensate. How do they compensate? Shares to I will not give. I'm sorry, I will tell. What is the fair value of the share we have taken? At least the fair value of it, a little higher than the fair value only we will give you as in cash. Or one more thing can happen. Okay, one more thing what will happen, I am cancelling the old plan, I will enter into new plan for the remaining period only. Okay, somehow I will compensate, earlier I gave 100 shares to you, now I am giving 200 shares to you, my dear. You already worked for 3 years now, work for 1.5 years. That's all. More number of shares I will promise you. There are some reasons I should explain it to you. Are you getting my point? Right. So let's learn a small situation. Suppose you paid cash. 99.9% this will happen. Okay. There are some companies, they never issue the shares. They will issue ESOPs, but they will never give the shares. Last day, what will happen? They will cancel. What is the fair market value of the this there? No, plus 5-10% extra they will add it. 5-10% extra they will add it, and they will give you the cash to you. So are you happy or not? You are happy. Why you are happy? Suppose it is a listed company share, 100 rupees worth share mein 105 I gave you. Correct na? 100 rupees market mein, if you are interested, now only you purchase. If you are interested to buy my share so much, now only you purchase it. 5 rupees a party. Okay. What else you want? Sufficient na? That's all. So both the way, both the people are happy. And here I have not liquidated my number of shares. Correct. This guy will go to market and purchase. I am not going to issue fresh shares. Correct. If I issue fresh share, what will happen? Capital will increase. My ownership ka percentage will come down. I am the main owner. My percentage will come down. Na? New funds will come. I am not the owner. No. It will be reducing my percentage. That is the problem. That's why they don't give the shares. Okay. If you have paid cash, right? So by this time, when you do it, what is your ESOP reserve, my dear? Your ESOP reserve must have been already 30 reached after passing 10 plus 20. Correct. When you are paying cash, you should say it is cancellation of a share. How do you do? Equity share capital account debit, security premium account debit करके 2 cash will give. Correct ना? Here also, first to the extent, correct ना? ESOP reserve को we will debit. Got it? ESOP reserve को will debit it to cash. Whatever the excess, suppose excess I have paid, then you have, that will be excess if you have paid, that will be employee benefit expenditure, profit and loss ko it is going to be taken if this is a balance. I hope you understand. 30 is there, but you paid 40. 10 rupees you have to book expenditure. No, 30 only, 30 below I paid. Not a problem. Below I paid. Still ESOP reserve is there. ESOP reserve ko you transfer it to retained earnings. SOCI ko transfer. I mean, retained earnings ko you are supposed to transfer. Is that clear to you? This is the some important concept. Okay, right. Let's go to cash settled SBP. Equity settled may, first of all, in case of equity settled, my dear, first fair market value of the grant, you measure on which date? You will measure it only on the grant date. Do you remeasure? No way, unless until if there is a such modification or something takes place, otherwise, correct, otherwise not required to remeasure. Only one time we will measure it, same number we are going to take it, correct. But in case of cash settled, correct, in case of cash settled SBP, we have to remeasure, correct na? We have to remeasure. When are you supposed to remeasure? On each balance sheet date. That's all? No, and on the settlement date also. On the settlement date. Balance sheet date also you will remeasure, settlement date also you will measure, and you will measure it on the grant date also. Okay, grant date is just for the purpose. Anyhow, you have to remeasure on every balance sheet date and on the settlement date, that is exercise date. Exercise date may also you are supposed to remeasure. This is first point to be noted. Next, cash settled. Cash settled means what? You are liable to pay, correct now? You are supposed, it is payable in cash. Correct now? That's why what is this? This is a liability. This is a liability in the balance sheet. Obviously not a reserve. Is it a reserve? No, it is not a reserve. It is only a liability. Agree? Correct? And what are the rules and regulations? Will be same exactly, except the remeasurement. Correct? Except the remeasurement. All other things means modification rules or cancellation rules, everything, conditions related to performance conditions and market performance, non-market performance conditions, same rules, same rules, same rules for modification or cancellation. Correct? Market performance conditions or non-market performance condition, same, no change, no change. Right? Only the change is earlier it is reserve, now it is liability. Next, earlier we will measure it at only one time, that is on the grant date, and the same amount is going to be amortized over the vesting period. There is no concept of remeasurement. Correct? But now what is happening? Remeasurement. On every balance sheet date, again you should go to valuer, get the valuation done. Okay? Right. At the same time, on the date of settlement also, you need to remeasure it. Okay? This is the point to be noted. Rest all the conditions are all 100% safe. Okay? Can we go to group share based transactions? Right. Group share based payments. Okay? Group share based payments. What is this? Any idea? One situation which they ask every time. Whatever they ask, only one situation they asked, not beyond that actually. Here, actually totally four circumstances are there. But all four circumstances, as I told, not necessary to dig and deep right now. Now deep dive करने के लिए not required. That example is more than sufficient. Listen, this is a holding company, okay, and there is a subsidiary company. Correct? Look at this. Subsidiary company has employees. Right. Grant will be entered by, there is a grant. This is the grant. Grant means agreement. The agreement is between whom? Holding company and subsidiary employees. Okay, not holding company with holding company employees normal. That is what we discussed so far. Correct. Now holding company with subsidiary company employees, say if they have entered into agreement. So now first question. Okay, first question. This is the grant they have entered. First, holding company books may. Right, holding company books may. What is the entry they should pass? Because of this agreement is what? Are you employee, work for the subsidiary properly for 3 years. Then I will give my company shares to you. Correct? Right. So holding company books may, what is the journal entry will record? Excellent. Investment in subsidiary account debit to ESOP reserve or SBP reserve. Correct? Yes, exactly. Done? Right. What is the journal entry in the subsidiary books, my dear? Yes, employee benefit expenditure account debit to capital contribution or capital reserve, you can say in simple words. This is the only point something is sitting. Okay, right. Here sometime what are the other possibilities that can happen? Not assets. Sometime what happens? Group will tell. What it will tell? Ravi, you work. Okay, I will work, sir. There may be subsidiary 1, there may be subsidiary 2, there may be subsidiary 3. Ravi, you may work for first year, one, correct. Totally you have to work 3 years. 3 years within the group you have to be there. 1 year may be here, 2 years may be here, 1 year may be wherever it is, not a problem. I will give you the share at the end of the 3rd year. You understood my point? I can be employee in any one of the group entities. Under this circumstance, E entry will remain same. H company will do, but every time they will be keep on changing. What is changing? Investment in subsidiary number 1, suppose Ravi worked only 1 year with subsidiary 1. So first year entry will be investment in subsidiary 1 account debit to ESOP reserve. Second year, investment in subsidiary number 2 account debit to, they will record. Second year, 2 years I worked with this company. Correct na? 2 years they will pass investment in subsidiary 2. 1 more year I worked with whatever, assume 4 years is the vesting period. Accordingly, it will change. Next year. Subsidiary company, what will they record? Subsidiary company will record same entry. There is no change in entry. EB account debit to capital reserve only, they will record it. Is it clear? Right. One more situation, what can happen? It may be, first thing, okay, parent company, correct na? Subsidiary company, subsidiary company will enter into an agreement with employees. Yeah, subsidiary company will enter into agreement with employees saying that I will get you the parent company shares. What did I say? I will get parent company shares, not my company shares. Got my point? How do you get a parent company share? They may give it to you and you may give it to employees. One. Or, correct na? You may need to buy from the open market से purchase करके इसको दे दो. You don't hold it, immediately you give it to the employees. E-transactions are supposed to be accounted for, but these transactions are never ever asked. Subsidiary giving it to the employees, correct? Yes, of the holding company shares, correct? Agreement is entered by subsidiary to employees. Now it is subsidiary responsibility not to issue their company shares, first of all, correct na? It is going to get the shares of the parent company. Maybe that company will donate you and you give the shares to employees, or they don't donate. Example, they may say you purchase in the open market and give it to employees, or you can say you transfer the money equivalent to them na. You employees go and purchase it. Whether you want to purchase, do not want to purchase, that is your choice. It becomes cash settled from the subsidiary angle. It becomes what? Cash settled from the subsidiary angle. Agree? That is there. One more question, generally practical thing. This is not at all theoretically, they will never ask you. Okay. Generally, what will happen? Recharge will happen. What is it? Recharge. Recharge in the sense what? Holding company is there, subsidiary company is there. Got it? Right. Holding company, subsidiary company. Now, holding company will give the shares to employees of the subsidiary company. Correct? Hello, correct? Now, what does it happen, my dear? Holding company will charge the same to subsidiary company. They will charge same to subsidiary. They will bill. Have you understood? I gave 10 lakh worth of equity shares to employees. Correct? I gave 10 lakh worth of equity shares to your employees. That's why I am charging you 10 lakh rupees to you only directly. This is how it happens normally in the market. Now what should I do? In recharging, there is no guidance. But yes, but all the big fours and all the, outside India entities and everybody, what do they follow? One accounting treatment they will follow. They will treat this as a separate agreement. This is separate agreement. Okay, right. So now holding company, correct na? Not holding company. Yeah, holding company books may also, right. Subsidiary company books may, I will say subsidiary company books may. Normal. First thing is, what do you do? Employee benefit expenses account. Employee benefit expense account debit 10 lakh rupees I will record. Okay, to ESOP reserve. Is a capital reserve only, but we will say ESOP reserve. Actually, capital reserve word. 10 lakh rupees will record. Okay. Now you have to make a payment. Now you have to make a payment to parent company. Are you supposed to make a parent company? Yes, 10 lakh rupees they billed. You have to make a payment. Now what is the entry? Question clear? First thing, this is as per the standard. This is as per 102. We have recorded the journal entry. Second thing, now you are making a payment to your parent company. You are making a payment. Now tell me. Okay. Once again, expenditure is not correct. No. Again, employee benefit expense account debit to cash means employee served for one time, two-time expenditure is booked. That is not correct. Okay. Right. So what she told is correct. Second one. That is ESOP reserve account debit to cash. Bank payable. Whatever 10 lakh or 10 lakh. Correct. No? When I thought that is free, that's why I kept it as ESOP reserve. When I got to know it is not free, that is a kind of correct. No? Return. Right. That's why this point will come. This is what practically we should follow, but there is no guidance on nationally, internationally, IFRS may also no guidance. It is practice. It is a practice. Right? Nobody will agree for the one more time expense account debit to payable or expense account debit to cash means no company will accept it. That's why ESOP reserve account debit to, yes, when the benefit has come, when I feel I have credited. When benefit is gone means I am debiting same reserve. Why should I hit my profit and loss statement? Clear? Right. These are the important points of Ind AS 102. Okay. Yeah. Holding. Okay. You are talking holding company books of account. Okay. Holding company books. First entry. Investment in subsidiary account debit to ESOP reserve. Correct. Now next money you have got it. Then there is no investment. Then cash account debit to investment. You have to give the shares to people, no, later. That will continue. ESOP reserve will be turned into equity share capital, security premium later. Okay. Right. That's how it happens, my dear. Yeah. So, chalo, my dear. I hope this is clear with respect to ESOP SBP 102. Correct. Na? The all important points we have covered already. Right. So, as planned, let's go to 109. Okay. Mixed with 32. Right. 107 is purely disclosure standard. Okay. And 111, 112 basically. 112 also is like purely disclosures. Correct. Na? Arrangements and etc. All those things you don't need to read. From exam point of view, they never ask, they'll never ask also. Got my point? Right. I'll do some analysis. Okay. I'm already on the way. Process may hai. Maybe once little busy with your work and I have some other personal work also. Once after your class, I'm running. Okay. So once afterwards, my analysis I'll give. Okay. Maybe in the video, 5-10 minutes ka video. What is my expectation where you need to focus a little more or something? You just, that's it, just hardly 5-10 minutes ka time. Listen. If you are okay with my opinion, you can follow. Otherwise, you can ignore it. That's all. Correct. Na? It's not like 20 hours ka discussion, 5-10 minutes ka discussion. So that can be, at least you can have a look at it, think of it. That's it. So tomorrow will be, I mean, this 2.5 hours time is available. Aramse will complete 109, each and every concept, whatever the points you have mentioned, that will Pakka will clear it. Tomorrow full focus on 115, 116. Little time if I get, we'll do it on 103 also I'll do. Okay. But I may take another 2-3 hours of class, either Friday or Saturday. I'll inform you. Please try to please come there. 103, 110 mix karke will close it. So that 103, 110 all adjustments I'll deal. I'll not make you solve the one sum, because you know one sum if you solve 1 hour it will get over easily. Correct. Na? But all the adjustments of the standard, where it will come, where you should solve it, whether you should debit, credit, first what entry happens, Correct. Now, how to handle most of the circumstance in accounting? No, if you know correct journal entry, na, you are done already. Correct. Agree. So when the other girl said no reserve account debit to cash करके बोल दिया, that's all over. No disclosure representation anybody can do, right? But generally the worst problem, na, many times what happens, people talk from the one side, discussion will happen, other leg they will never speak, and some many times another the worst problem, na, from my books I will talk, other party books they will not talk. You got my point? There the problem, confusion will happen because you studied only from one side. Yes, standard also discuss, as I told you, financial guarantee contract. Standard only spoke about one side, issuer of the guarantee, but not receiver of the guarantee. Practically, receiver will be my holding, subsidiary will be receiving, holding will be giving. Correct, na? I will be the auditing both the things. E side I know, A side I don't know. But then how do you consolidate then? Consolidation time, what adjustments will come, how to knock off this? You understood? Then you will get to know that your knowledge is not complete. Ada correct na? Arda barda ide ashte. That's it. Not complete knowledge illa. You need to know what is accounting in holding, what is the accounting in subsidiary, and how do we knock off in the consolidation, and any deferred tax impact because of this. Then I know how to handle it practically. Am I talking correct only? That is what you need to know. That if you know, you are fit to work. Correct. We can start working. That's seriously right. Right. Chalo yaar. Let's get into the Ind AS 109. Hama. Which one? September 25. I don't have. Do you have? Yeah. So Ind AS, this question is from RTP 2025 September. Max Limited enters into share-based arrangement with its employees on the following terms. Okay. Each employee will receive 500 shares if they remain employed for next 5 years. Okay, that is normal so far, right? Astena question, more is there, done. It is expected that no employees are expected to leave during the period. So then that all how many employees they told? Not told. Okay, right, not a problem. Below he will tell all employees are numbers will not change. Fine. The grant date fair value of the award is 4,000. Clear. If the employee leaves Max Limited after 5 years period, but before his shares are listed, the entity has an option to purchase the shares for the fair value from the employee. It is vested, but you can purchase it. You will pay means you will transfer cash account debit to SPB reserve, directly you will transfer. Okay, if you are paying more than the fair value, what you have accounted for, then that will be employee benefit expense. I have accounted for 40 rupees, but you purchase for 50 rupees. Correct. Now, 10 rupees will be employee benefit expenditure. 40 rupees will be adjusted with reserve. Okay, done. Not a problem. We'll see that one by one. And on the grant date, Max Limited expects to list in the list in the next 3 to 5 years. That's what I'm expecting. This is the first share-based plan. Max Limited has no past practice or stated policy buying back the shares from the employees when they leave. Okay. Neither does Max Limited expect that it will settle the award in cash. Okay, fine. That means equity shares may only issue. It's ESOP, what is that? Equity settled SBP reserve. At the end of the second year, Max Limited are no longer expects to list. Means listing share not possible. And the employees are informed of this fact. Max Limited announces to employee that if it is not listed after the 5 years and employees leave, Max Limited will repurchase the shares. Okay. The fair value of the shares is 6,000 rupees on this date. Then at the end of the third year, the fair value of the liability has increased to 9,000. Okay. Determine the accounting for the years 1 to 3. First 1 to 3 years you should do it. what would be the treatment of the awards if at the end of the year 2, Max Limited does not inform employees that it will repurchase the shares after 5 years period, and a listing of the entity shares is still achievable. But at the end of the 6th year, it has not yet listed, so 2 of the employees leave. Max Limited exercises settlement choice, buys the leaving shares, people go fine. What is happening here? Shifting from ESOP reserve to liability. Correct. Na? So you have so far treated initially first year mein what is the understanding? It is going to be settled by issuing the equity shares. But at the end of the second year or whatever, second year time, we understood that we are not going to list in the lifetime only, whatever the reasons. Correct. Na? So it is, we are not going to do means you have informed them that I am going to make a payment to the cash. Then it is going to be liability to you, not a reserve. It is going to be a liability. Correct. Na? Where is the answer directly straight away? I'll explain from there. Last page, no, mostly. Oh, all the subjects are sorry. That's why I have 106 pages. I was thinking. Financial reporting. Number was what? Here only. Last question. Correct. So first of all, on the date of grant, it is equity settled SBP. Correct. Na? The fair market value you have already determined. Right. Again, here has he given any numbers? How many employees? No, he has not told. Only fair market value, only 4,000 rupees. That much he told. 500 shares he told. How many number of employees? He has not given all that. Correct. Na? So number calculation is not the concept here. So he is actually testing you. Correct. Na? Conceptually. Right. Next. So let's read the answer straight away. On the grant date, the employer accounts the arrangement as an equity settled. That is what we spoke. And because there is no present obligation to settle in cash. Yes, that is perfect. All right. So first year, what is the general expenditure? Normal employee benefit expense account debit to ESOP reserve or SBP reserve, whichever you want. Correct. Now, what do? Assume one employee only is there or whatever it is. 4,000 rupees is the amount divided by 5 into number of employees, number of options, whatever you want to keep, you keep the numbers. Okay. So what he said, yeah, 4,000 divided by 5, because he only has not given number of employees. He told number of shares karke, per head number of shares he told, but how many heads he didn't tell. So 800 rupees you have done correctly. Next, at the end of the second year, you have to create an obligation to settle it. Correct na? So now onwards, what is that we understood? So far it is ESOP reserve, equity settled. Now it is going to be cash settled. Why it is? Correct. They only told we are not going to close it. We are not going to give you the shares. We'll give you the, we'll buy from all. We buy the shares. I mean the right, we will purchase it from you. That means cash we are going to give it to you. We don't give you the share. That's what the concept. Correct. So now, correct. So what is that here happening, my dear? Employee normal. It is like, how do you deal? Like SAR situation you will deal. SAR situation. SAR situation in the sense employee benefit expense account debit to liability. SBP liability. Right. So, one second. SBP reserve only they did. They reverse it because it entirely is going to become the liability. First they are recording as a reserve. Okay. End of the day, in my opinion, that either you entry can be in two ways. Net impact you should see. Okay, right. So in third, when is that question? Can you read the question? I don't want to go back and front. From the question you keep, at least answer I'll keep. Right? In second year, what is the conclusion? I could not remember. Okay. Correct. But in third, in year 3, nothing has happened. Year 3 fair value they have given. Actually, they should have given the year 2 number also, fair value they should have given. Because the minute it has become cash settled, it has become cash settled which date? When? At the end of year 2. Then fine. Actually, hmm, hmm, hmm. Here journal entry is wrong. Journal entry is wrong. I agree. That 800 rupees balance, I can use my space. This is better. Okay. Initially, you must have recorded employee benefit expense account year 1. I'll suggest like this. That is equal to 800, which is 5000. Correct. Na? 5000 divided by 5. 4. Yeah, 4. That is equal to 800. 2. Okay. Yeah. 4000 divided by 5. That is equal to 800. Agreed. So SBPR, that is equal to 800. Fine. Correctly speaking, Y2 itself, what is that you should do? It is going to become cash settled. Yeah. When it becomes cash settled, what are you supposed to do? Are you supposed to restate or not? You must restate. Correct. Now you must restate to the grant fair value of the grant at the end of every balance sheet date. That's what we spoke. Yeah. So restate it to what number? 6000 is the number provided by us. So how much should be the liability supposed to be? 6000 into 2 divided by 4 years. 4 na? 4 or 5? 4 years. No, 5 years. 5 years only. Yeah, it should be 5 years total. Agreement is 5 years only. They never told reduce it to no. It's 5 years only. If it comes to this, what is the number? 2400. What is the number already sitting? 800. So that means 1600 more you should add. Correct now. So directly you can record employee benefit expense account debit 1600. Okay. SBPR reserve also account debit 800 to SBPL liability, that is equal to 2400. You record it. Then your problem is solved. Correct na? Third year also Y3. Y3, what is the number? What is the fair market value? 9000. So 9000 into 3 divided by 5. How much will it be? 5000? 4000. 400. Correct na? So out of the 2400 you already have. Correct na? So 3000 rupees. Yes. 3000 rupees ko what do you do? Again, employee benefit expense account debit to SBPL. That is equal to 3000. 3000. That's all. Yeah. Answer is same only. 2400, the answer is correct. They missed out one entry, debit entry they forgot. They missed out that. That's not. Where is this here? 1 second. Here. Here they should have recorded not 1 by 5, 1 by 2 by 5 at least they should have made 1600 they should have recorded. Second entry is not okay. Got it? Because at the end of the second year itself, it is concluded that we are not going to give the shares. Then why are you recording like this? 100% you are fine if you record 2400. Yes. Y3 also 3000. Y3 he did it correctly. Y2 is their typing error, whatever, some error. You can consider that error. Done. I think this next concept, I don't think so you have a question, no? That's simple. Done? Right. That's it. Right now. Shall we go ahead? Yeah. So let's go to Ind AS 109. Financial instruments. Yeah. Financial instruments 109 and Ind AS 32. Ind AS 32 talks about only presentation. Presentation of financial instruments. Presentation means basically the classification. Classification between, yes, between the equity and debt. Liability, debt, whatever. Actually, Ind AS 32 only will talk about the treasury shares. Our concept also is there only. Okay, Ind AS 32 has some other concepts also, like dividend correlated. Dividend related is discussed both the places. Okay. So some other concepts other than only this classification also is there, but the heading is only presentation. Nothing wrong. Overall, it talks about that only. Minor things are other than things also there. Right. 109 talks about what, my dear? 109 talks about basically recognition and measurement. Okay. Right. So first thing, we know that yesterday or day before yesterday, whatever it is, correct now. Financial instrument is a contract which gives rise to financial asset to one party, financial liability or equity to another party. This much we have learnt already. Correct now. What is a financial asset? What is a financial asset? Again, 4 lines of definition is there. One is cash, correct now. Investment in equity instruments of another entity, correct. Where next one is what? You have a right to contractual right to receive what? Either cash or any other financial asset, correct. Or you have a contractual right to exchange, correct na? Exchange. What is the exchanging? Financial asset with another financial asset, or financial liability with another financial liability, which is potentially favorable to you. You have to contractually exchange it. You have a right to exchange it. In this exchange, what will happen? I'll get gain. That is a financial asset. Okay, right. The fourth bit also is there. What is the fourth bit? Where you are going to deal with the options. Okay, your own equity instruments you are going to give. That is actually we should read financial asset definition, financial liability definition, equity definition. All the three things, if you keep it aside, then if you read it, then you will understand if the agreement is to issue my shares in fixed number of shares, if I am going to issue, because of this agreement, it is going to be equity. If it is a variable number of shares I am going to give, it is going to be a liability. Correct. Our concepts will be very, very clear when we read the full definition, but that level not required. I will give you a simple table. I will give you. You will understand what is equity or liability. Karke will understand. Okay, fine. So first concept. Your classification. When are you supposed to take classification, my dear? When do you do classification? Classification means whether it is a financial liability, whether it is an equity. That should take place when you enter into the contract. When you become party to the contract. When you become party to the contract. Okay. When you become a party to the contract, that day only you have to decide it. Hope you understood. Today I issued shares. Today only I have to decide, is it a equity or is it a liability? Got it? Right. And as we spoke already, initial recognition, correct now. Initial recognition, what is going to happen, my dear? Initial recognition is going to be in which fashion? Everything that is a financial asset and financial liability, both will be at fair market value. Why equity they have not kept? Equity is always residuary number. Equity is what? Is a residuary number. Okay, so that's why here fair market value concept does not come. There will not be fair value for equity. Equity one time whatever residuary is what? Equity, leftover. Fair value of liability, if I receive some X number, out of that fair value of liability I will determine. Okay, balance is what? Equity. Equity will, correct na? Again, remember, once you transfer it to any equity, no restatement concept. Equity ko once you transfer, right, you can make a note. Once transferred to any reserve, or equity, okay, no restatement. No restatement or no subsequent measurement. Okay, this is something important. Just give me a few seconds. Yeah. So once you transfer it to any reserve, there will not be any this one. Okay, right. Listen carefully. Little bit will spend on the classification. Important, that is. Okay, it is discussed under 32. Ind AS 32 may this is explained. Very much important. Okay, right. When you have got an instrument, one financial instrument is there. Okay, whether it is a financial liability or whether it is an equity. That is the concept. Fine, right. So now first thing is what is the amount? There will be 4 situations, right? Totally there you can expect 4 situations out of it. Situation number 1, and next is what? Amount. Next is number of shares what you are going to issue. Okay, then you will accordingly will decide what is the classification. This is the outcome of the reading of the definition. This is not something coming from the standard separate paragraph mein nahi hota. It is mentioned in the definition. Our definition correctly once one reads, no, then we can make out the table from there. Fine. Situation number 1. What is the amount you will get? Suppose fixed amount. Okay, fixed amount. I already gave you, or I am going to give you fixed amount. How many number of shares you are going to get? That is also fixed number of shares. Means already fixed. It will not change. Are you getting my point? Then it is going to be classified as equity. That's all. Okay. In all other circumstance, what is other circumstance? One is fixed, next is variable, and the third situation, whether it is variable, whether it is fixed, or this is also variable, this is also variable. Under all other circumstance, it is going to be a financial liability. It's going to be financial liability. Got it? Right. Listen, here there is a small point is there. Okay. I will say I am issuing convertible debentures. What do I say? Example, I will issue convertible debenture. Okay. Convertible debenture, what is the issue amount? Sir, amount is equal to 10 lakh or 10 crores, whatever, some number I will say. Correct. Rate is equal to say 10% convertible debenture, I will keep it. Now number of shares, when it is convertible, no, always we should tell what? Convertible when? Correct. Now, okay, it is convertible after 3 years. Agree? Of conversion after what time? You should have mentioned it. Second point is what? Number of shares conversion. Correct. Now, then we will say 10 lakh divided by fair value, fair market value on the date of conversion, like this they will keep. Have you understood my point? Whatever you pay 10 lakh divided by fair value on that date. Correct. Now, so this XX number of shares will come. This X number of shares I will issue after 3 years. Now, how do I deal it? The minute generally students read, na, ये convertible है तो compound financial instrument, embedded derivative करके mind में आ जाएगा. Nothing is there here. Got it? This entirely instrument will be classified as financial liability. It is not equity. Even though they use, if they want to cheat you, I mean cheat in a sense, they want to confuse you or test you, I should say. Okay, convertible word pakad ke, you cannot conclude like that. Okay, but most of your questions, what will happen? They will give fixed number of shares. That's why you should be very careful. You understood? These kind of things they can test in MCQ if they really want. Because one shot mein ho jayega na. Is information de do? Is it a liability or equity or some other concepts, you keep it here. Correct na? Partly equity, partly liability, something like that. And you tell like 2 marks for this analysis. Makes sense. Right? Remember, when the number of shares here, is it a variable number or not? Yeah, because what is the fair value? How do I know? That is not fixed today. That is based on some formula. Correct na? It is going to be variable number. Entire instrument will be classified as financial liability. You understood my point? Entire instrument will be classified as financial liability but not equity. Clear? Right. But in your questions, what will happen, my dear? Yeah, in your question, next example, what do I say? Convertible debentures. Correct na? Are some 10 CR, whatever it is. How many number of shares? How many number of shares? Say I will say 10,000 shares, I will tell. Very clearly I will tell. 10,000 shares I am going to give. Yeah, convertible at the end of the 3rd year. Convertible at the end of the 3rd year. What is the coupon rate here? Coupon rate is equal to 10%. Correct? Next, what do they say? Next, additional note, additional information, what do they give? Correct now, plain debenture. Plain debenture, what is the rate? Plain debenture rate is equal to say 14%. Plain debenture rate 14%. I mean, plain debenture means what? Without conversion option. Without conversion. Without conversion option, plain debenture rate is going to be 14%. Agree? This question is what normally they will ask you. Hope you understood. So then what are we supposed to do now here? Here, what is that you have collected? You have collected money for what? You have collected money. Money for what? Money one for debenture. Agree? At the same time, second thing, have you sold the option? Have you sold the option or not? Yes, you sold option. How you sold option, my dear? You gave a convertible option to the employee. This is optionally convertible. What is this? Conversion is always option, not mandatory conversion. Here, okay, generally, I will say optionally convertible, I will write better to get a clarity. Optionally convertible. Understood? Optionally convertible means I sold an option. Correct? If you wish, you will convert. If you don't wish, you don't convert. Agree? That means normally, if you want an option in the open market, if you want an option, my dear, what do you do? What does the company do? The company collects premium. Agree or not? If you studied financial management, na? Correct? Na? Financial management mein writer, holder, you must have heard. Correct? Na? Writer writes the option. Correct? Na? Company is a writer of the option. Agree? Correct? Na? Holder is holder. Debenture holder is the holder of the option also. Writer will receive the premium or not? Yes. Writer is receiving a premium. Hello, correct? He is receiving a premium for what? Premium for their own shares. Correct? Their own shares. Do you agree with me? Is it for their own shares only or not? Yes, it is for their own shares. That's why whatever the premium amount you determine, that is not going to be considered income, because when you are trading, when you are getting into a transaction, you are getting an income out of your own shares. Can never be profit and loss income. Okay, that's why it will never be transferred to profit and loss. It will never be transferred to other comprehensive income. It should go to directly other equity eco. It should go. That is the logic. Are you getting my point? What is agreement? Agreement is what? Today I collected 10 lakh money. Correct na? Come after 4 years and tell. What is that? What you want shares. That time what should I do? I should give my shares. Correct na? So here agreement is for what? Whose shares? Is it somebody other company shares or my own shares? My own shares. Right. 10 lakh rupees is for debentures. 10 lakh rupees is for debenture from plus premium. Debenture plus premium. Why premium? Writer of the option always will receive the premium. So 10 lakh includes a premium. Correct now? By writing this now, if my company have issued shares, debentures to you, have you got an option to exercise or not? Anybody will give freely option? Huh? No. That means 10 lakh rupees you gave me, na? 10 lakh rupees includes premium. That option, a premium option value ne embedded derivative. Option price is what? Embedded derivative value basically. So how do you determine? Okay. And again, the option value, what I am trying to tell, option value, correct na? We don't calculate option value as per the guidance of the standard. Option ka valuation will be there. We don't do that way. What do we do? Total money received minus present value of liability will remove. Then remaining is equal to option value. That is called equity. Why it is called equity? Why not income? As I told, it is related to which company shares? My own company shares. If it is transferred to P&L means what? I sold option on my shares to you and I got a money. That money is my gain. NIM shares you are selling, other NIM profit business. A transaction on own equity instruments can never be either income or expenditure. Okay, transaction on own equity instruments can never be income or expenditure. It is always equity transaction. It is always equity transaction. That's why we'll do like this. Okay. So now what do we do? What is the total amount collected? Correct na? Total amount collected. How much, sir? 10 crore rupees you collected. Now minus. Minus what do you do? Present value of the liability. How do you do present value of liability? Some number will come. This is other equity. What is this? Other equity. Other equity is nothing but option premium. This is nothing but option premium. Okay. Have you understood? How do you calculate this present value of liability? Discounting. Discounting what? You have to determine the cash flows. Correct na? Year 1. Year may, if you do 1, 2, 3 years. What do you give? Interest of 10%. 10% means how much? 1 crore. Correct na? 1 crore. 10 crores into 10% is equal to 1 crore. Next year also 1 crore. Last year may what do you do? 1 crore plus 10 crore rupees of principal. Totally 11 crores. And you will multiply present value factor at the rate of 14% plain rate, market rate. Correct na? If you measure it, if you discount it at market rate, then market value will come. If you discount it at your own rate, what your own rate, your own number will come. Are you getting my point? Your objective is what? Present value or fair value? Both are same. At the rate of 14% when you discount. Okay, so now you got some number. How much you got? Say example 9 crore rupees I am keeping it. E 9 crore rupees will go here, 9 CR. Then 1 CR, correct na? 1 CR is going to be equity. Means what? You have sold your company shares ka option to other party by taking 1 crore rupees of premium. Okay, right. That's why that number is supposed to be transferred to other equity or equity. Understood? Right. So now what is the journal entry we should record for this? What is the journal entry we should record, my dear? Bank account debit 10 CR. Correct na? 2 debentures. How much? That is equal to 9 CR. 2 other equity, that is equal to 1 CR. Okay, other equity, that's other equity is nothing but reserves and surplus. Whatever the name you want to write, you write it. Agree? Right. Next, this, as I told you just now, it will never change. Once it is transferred to other equity, it will be there only. Okay, right. Sir, 3 years over, sir. After 3 years, what should I do with this reserve? Transfer it to retained earnings. That is accepted. Understood my point? 3 years over, debentures are converted into equity shares, whatever it is. Correct na? Debentures are redeemed by giving the money. Correct na? Right. Now what should I do with that reserve? Some reserve new name has come. Name ko kya karna mein? You can transfer it to retained earnings. You don't need to keep it in the same name. Other equity, some name, correct na? Example, reserve on optionally convertible debentures or equity element. Big names people do write. Let them write. Nothing wrong in this. Have you followed me? Right. Now, first next thing, what is that we should do? Next thing what you should do? E-debentures. Right now at Y0, what is the book value? 9 CR. Correct na? But at Y3, it has to come to how much? It has to come to 10 CR. Agree na? Right. So that's why what are you supposed to do? You have to, what are you following? You are following amortized cost because it is a plain debenture na? Yes or no? It is a plain debenture. So amortized cost method you should follow. Correct. Next, what is the rate I should apply? Rate, that is nothing but IRR only. IRR is nothing but 14%. Why? By discounting by 14% only you got this number. So we have to do ulta. Agree? Exactly. So now what are we supposed to do? You should say opening balance, interest or finance cost expenditure at the rate of what? 14%. Correct na? And what about the amount you have paid? A number, closing balance. correct? Yes. So here 1, 2, 3. It will come to how much number, my dear? Last day 10 crore ko aa jayega. You will bring it to 10 crore. Now listen carefully. Once it comes to 10 crore, my dear, the debenture holders can ask you two things, possibly, correct? Now what they can ask? Pay me cash. I don't want your share. Can they say or not? Yes. So tell me, when they say cash payment means what should I do? Debentures account debit, that is equal to 10 CR to cash. We will give them 10 crore rupees cash because debenture value also 10 crore rupees ko aa gaya. Agree? Right. Or they can say issue, you should issue equity share capital also you should issue. Correct? When you issue equity shares, what do you record? Very simple, debentures account debit to equity share capital to security premium if there is any, correct? 10 crores, 10 crores. Okay, but after recording all these things, you should be writing one more thing, plus. What is that? We forgot this one, no? 1 crore अदर इक्विटी में सिटिंग ना, अदर इक्विटी आपका डिबेंचर ही खत्म हो गया. वाई यू वांट टू कीप दिस नंबर इन द बैलेंस शीट स्टिल? करेक्ट ना? Other equity account, other equity, whatever the name earlier you wrote it, that can be transferred to retained earnings 1 crore, 1 crore. This is what I was mentioning. Okay, understood? Yeah, practically you should think one more level. Deferred tax you have to calculate. 1 crore mele deferred tax. Day one initially initial entry should be correct na. Initial entry if you speak na, only this entry will not come, my dear. Plus, what will come? Other equity account to debit to deferred tax liability. It is a income. It will come a deferred tax liability. Got it? It will not be 1 crore actually. It should have been reduced by 25% to 30%. It should have already been reduced. That is what I was explaining under Ind AS 12. It is a compound instrument. We are breaking it into two, other equity and this. Other equity ka you have to take care like this. This additionally, don't expect this question in the E concept. They don't ask in the exam. But life mein karna padega. You have to think that angle. Shall we go ahead? Are you comfortable? You were asking this, no? Right? Next, suppose this question, if I convert into mandatorily convertible, I think they asked once. Mandatorily convertible. Mandatorily convertible debentures after 3 years. Mandatorily convertible debenture after 3 years. Okay, say example, you collected 10 lakhs or 1 lakh rupees, just for easy computation, I'll keep it. Mandatorily convertible. Okay, coupon is equal to 10%. Okay, market rate of plain. Market rate of plain debenture is equal to say 12% market rate. Right? After 3 years, what will happen? Converted into equity. Mandatory. You don't have a choice. Correct? Is there any derivative here? There is no derivative. Is there a derivative? There is no derivative. It is already agreement is there. Correct na? But is it a compound financial instrument, or is it is it a compound financial instrument, or is it equity, or is it liability? What do you answer? If I give you 3 choice, how compound? It is a compound, correct. It is not equity fully, it is not liability fully. Why compound instrument? Here you have two things. Do you have an obligation to pay interest mandatorily? Obligation to pay interest for 3 years. 3 years interest you have to pay. Correct na? And issue equity shares. Issue what equity shares, my dear? Fixed number of equity shares. Fixed number of equity shares. Since I am going to give fixed number of equity shares, that portion it is going to be considered as equity. Agree? Now how do I do? Yeah, this is an obligation, na? Obligation, so you have to find out, you have to find present value or fair value, find out the present value or fair value of this, you have to determine. Agree, na? Yes or no? Right. So what is that number it is going to happen, my dear? What is the amount of interest you have to, you promise to pay? 10%. 10% means first year, second year, third year. Correct, na? Every year isn't it 10,000 rupees? 10,000 rupees. At which rate you have to multiply? 12%. Present value annuity factor you find out, 1 divided by 1.12, GT press करो, GT press करो directly. 2.4018. That is equal to 24,018 rupees will come. This is present value. Hello, correct? So now what is the Y0 journal entry? What do you record? Have you received cash? Yes. How much? 1 lakh. 2. Liability, that is interest portion. That is equal to how much? 24,018. Correct, na? 2. Other equity or okay, equity basically. Equity is equal to 76,000. How much? 75,982. Okay, 75,982. Understood? Now what will happen? E-liability, what will happen? E-liability ka unwind and make it, it will become 0 later. At the end of the third, it will become 0. How it will become 0? Opening balance, interest, payment, closing balance. How much is this? 2018 at the rate of 12%. Calculate. How much? 24 to 18 into 12%. How much more? 2,882. Then do no plus this minus 10,000. 16,900. Okay, 16,900 into 12%. 2028. Plus 20 minus 10,000. 928. 8928. Again 12%. 1071. It will become 0. Okay, some 2 rupees to 10 rupees difference will come. Ignore it. So my liability I have cleared. Correct. But what about 75,000 rupees sitting na? You will be issuing the shares, no? Our number will be 75,000. Okay, it cannot be no change, no restatement, nothing. Once you transfer it to equity, as I told you, no further touching that. Fine. So other equity, whatever it is, equity account debit to equity share capital to security premium, if there is any, that comes to 75,982. This is what you should do in this case. That's the, if it is compulsorily convertible debenture hai to we should do like this. Okay, so compound financial instruments we have understood. Next, one more. Are you ready? Done. See, listen, my dear. If it is a derivative, derivative related also, correct na? Derivatives first. Derivatives are what? It may be a financial asset, it may be financial liability. Correct. It may be financial asset or it may be financial liability. When it is financial asset, when it is potentially favorable to you, it is an asset. It is potentially unfavorable to you. Derivative means what? Where you are going to settle, if you are going to lose or you are going to win. In the share market, correct na? Right? In the share market, net settlement will happen. Net settlement, correct now. Whatever you are going to lose, you don't give something and you will not get something. Directly net settlement will happen. Net settlement means what will happen? Either you will be losing by paying the money or you will be gaining by receiving the money. Correct na? If it is potentially favorable. Yeah, if it is potentially favorable to you, right, it is unfavorable to you, that's all. Correct. It potentially favorable, unfavorable based on situation on 31st March on the balance sheet date, obviously. Correct na? Right. Next. Sir, how do you classify? It is always FVTPL. Fair value through profit and loss statement. Sir, amortized cost, FVT, OCA, no rule will work. Okay, no amortized cost, obviously impossible. FVT, OCI, no, it is not. I told you, only for the equity instruments you have an option to do under FVT, OCI. It is not equity, it is a derivative instrument. Okay, it will never happen. Hello, understood? Right. So, if I am following FVTPL, very simple, correct na? Suppose example, it may be a future contract. What is this? It may be a future contract, right? Right? If it is a future contract, what will happen? Future means what? Future of Reliance Future, if I say Reliance Future, means you are a buyer or seller? First you should tell. Future means both parties will be there. I am the buyer, you are the seller. Some party. First, which side you are there? Correct. Now, have you bought it? Have you bought it? Have you sold it? Right? Sir, I have bought it. Means, what is that meaning? Bought it means I promise that I will buy the shares. I mean, you don't buy actually, right? We will take one rate. E rate mein will buy it. Real share value goes up and down. Correct na? As on 31st March, right? First simple question. If you look at your demat account, whatever the information, are you in a gain situation or are you in a loss situation? Gain hai to positive, green color mein some number will show. Correct na? Negative hai mein red color mein it will show. Positive on 31st March how much? It will tell number na. Right. On 31st March, suppose buyer is losing. That means obviously winner. This guy is a winner. Seller is a winner. Right. So what is that he is going to record? For him, unfavorable. Correct na? For him, unfavorable. What do you record then? It is a loss, FETPL loss, you can say FETPL loss, or so whatever it is. Okay na? End of the day, it should hit my profit and loss statement. Agree? To derivative liability or future liability, whichever name. It is a financial liability. For me, financial liability only matters. For me, only financial liability matters. Okay, A number. Other party, what will he record? Financial asset derivative, asset account debit to, it is an income for him. Okay, right. On settlement date, it will again it may change. Today you have written 1000 rupees, I am into gain situation. Maybe after last day settlement date, you may get into loss. Okay, or you must have cancel the transaction. I mean, you must have come out of the situation only in the middle. That's a different circumstance. It is nothing to be worried. Have you understood circumstance first? Right. I'll tell you one maybe relevant for you, but just for a knowledge purpose. Knowledge purpose. Okay. You don't need to break your head too much. Okay. Right. One company may what has happened, which we saw. This is our Indian company. Okay. Right. Indian company. This company is issuing debentures. The debentures are issued in rupees. Rupees, obviously, we are not issuing in dollars. We are issuing it in rupees. Right. There is a one foreign entity. Okay. Foreign company is there. They have some account. Okay. Some other party ka account. Not my company account. Their account. They transfer the money in dollars. It is converted into rupees. And these guys have bought the debentures. They bought the debentures end of the day which are issued in rupee. Correct na? Now the problem starts now. What is the problem starts? Right? Here I'll say like say $10,000 ka worth of debentures I have issued, just for understanding. Convert $10,000 worth, I will convert into rupees. Correct na? Rupees ko convert ka, amount only I have collected from the foreign party. Are you getting my point? Other way around, if I say how much is the debentures issue? 10 lakh rupees worth of shares, debentures I am issuing. This is rupees. How much dollars that guy should transfer? $10 lakh, 10 lakh rupees. Say example 80 rupees is the $1 rate. Getting my point? Some number will come. Number amount only he will transfer it. Number, I mean again we will get rupees only for day one. Day one mein what do I say? I got it in rupees, so cash account debit. So I have issued debentures. Clear na? 10 lakh, 10 lakh. Clear, all clear. But the problem starts what na? The debentures are what rate, my dear? 10%. Agreement mein what is mentioned? Agreement mein what is mentioned? 10% of example. Just for making it more easy, I will say 100 rupees per dollar. We'll make $1 is equal to 100 rupees. If you make 100 rupees, what will come? 10,000 will come. 10,000 only, no? $10,000 will come. Correct? What that guy is telling, I transferred you how much? $10,000. Correct? Na? You should calculate on $10,000. $10,000 means how much will come? $1,000 will come. $1,000 into when you are correct. At the end of the first year, if you are giving, that day rate is equal to how much? 82 example. You should pay me 82,000 rupees. How much you should pay me? 82,000 rupees you should pay me. Subsequent year, if it goes further up. Are you getting my point? It will be again 83 rupees you have to pay it. Next, suppose if the period is 3 years, no? Principal you have to pay, na? Correct, na? Principal you have to pay, na? Principal also should be converted into equivalent to that $10,000 only you have to pay. ऐसा है agreement. You understood agreement? It will fluctuate. It is not like 10% on 10 lakh is equal to how much? 1 lakh. Correct, na? Right. Here here we have taken it 100. Here it should be not 100. It should be maybe 1 or 2 rupees I should take. Correct, na? Why means here I have taken 100 rupees, na? 1 or 2. Correct, na? 1 or 2 means how much will come here? 1,02,000 you are supposed to pay, not 1 lakh rupees. It will be 1,02,000, 103, 100. Correct, na? Well, when you are paying the principal also, it will not be 10 lakh rupees. It will be depending upon the rate on the last date. This is the agreement. Now, how do you account this? Excess amount will be finance cost. And that's why agreement में क्या लिखा ना उन्होंने 10% plus X करके लिखा. What is X sir करके? X is 2,000 rupees. It will be keep on changing. It will be 2, it is 3. When we ask what is this X my dear करके पूछा तो no, we'll do like this na. Balance है this is. What should come to your mind when you read this kind of agreement? Client का brain में नहीं आता. It has to come to our brain. You understood my problem? They don't know. You can't expect. I am to reading daily basis standards. So mine is different. A client where will he have time, Papa? They need to do so many things. You know, correct? Day-to-day activities hai time illa. When will they do? What is there here? If you observe carefully, you have a forward contract. What is a forward contract? Net settlement of forward contract of $1,000 ka. Correct? Are you going to lose that 2,000 rupees excess or not? Indirectly, you promise that I will give you $10,000. Correct na? $10,000 I will give you at the rate for 10,000 rupees को दे रहा है आपको. Agree or not? Right? And you will be, suppose if the dollar value has gone to 105, have you lost 5 rupees or not? Okay, dollar value went to 95. then have you won the game or not? Right. So in this derivative, in this debt agreement, you have a derivative instrument. What is the instrument? Forward contract is there. What is the forward? That you will give, correct na, 10 lakh collected, $10,000 I will give you. $10,000 while giving at the end of the third year, it may be more, it may be lower. It is depending upon the dollar rate. Correct na? So what is there here? You have got a embedded derivative in this. Correct na? It is included, embedded na, indirectly. It is not a plain debenture which is issued in rupees. Correct na? And again, tell me general logic also. You collected 10 lakh rupees. Are you restating this? No. Why? Means I have issued in rupees karke you will tell. Where are you restating? Not restating. But aren't you are holding the risk of dollars now? Yes, you have the risk of dollar. Correct na? Dollar rate goes up means you are losing. Dollar rate comes down, you are correct na? So there is embedded, some derivative is included, that is a forward contract, I should say, a derivative. Then we got it valued by them, nothing doing. First forward contract है इसमें, forward contract को separately value करो यार, a value a derivative करें, a derivative को निकाल दो from there and measure it correctly. Understood? It should click to you know that time when you read it. A clicking I told yesterday also, when you see the situation, it has to click first. A clicking a problem. Once it clicks what to deal, anybody will deal. Somebody other person will deal. Correct na? You can search, you can find one or other way, you can do it. Anybody does it. Clicking that is only problematic. People do write like this agreements, different. Why they write karke don't ask. Correct na? For what they write, we should account it. That much only I know. This is a small level complex. You should go to, I told na, big, I mean, banks and NBFC ko if you go na, financial instruments ka maja aa jayega. And you will die in between also. It will be too complex area. I mean, every agreement can have different. Client knows how it works, but client is not thinking from that there is a derivative in this. We should value it like this, and we should account it like this. करके इसको नहीं मान. We are paying extra, that they know. We are going to pay extra, that they know very much, because they are already paying the every month or quarterly wise interest already paying. So quarterly when you are paying, it is not 10 lakh divided by 10 lakh means 1 lakh will come. 1 lakh divided by 3 karke they are not paying na. They are paying more money. So, you got my point? And he also does not get that idea. There may be something included as per Ind AS we should do some. He also doesn't know na. You have to be very careful, very serious. One situation, one case study it will become. Correct, no? Seriously, that is too much will be included here. Chalo, that is, I hope you understood. Yeah, you're saying something? You have two instruments now, debt instrument, derivative instrument. Correct na? But it is here, the debt instrument wala will be amortized cost. Okay. This is also derivative, this is also liability because it is not, it is a derivative. You understood my point? It is a derivative. It is not equity. Because in this agreement, is there any situation saying that I will give my equity shares? Nothing. Correct. So first 10 lakh wala will be dealt as amortized cost method mein we will amortize it. But E portion you have to recognize. You remember, you know, just imagine 25 lakh rupees loss was there as on 31st March. Because of this number is big. 25 lakh also not small. Notify 45 lakhs. Loss was there on 31st March. Got it? 45 lakh is not a big number for them, but still. at least satisfied the accounting, correct na? FETPL accounting should be done. For the debt amortized recast, for this, okay, and it has happened कि I had to speak to valuer and I have to guide him. अरे ऐसा value करो यार करके because that guy also papa like this agreement he also has not seen. He should also should have experience na. He was giving some other way. No, no, it won't make sense. It is in the, he will say like with this, without this, what will be like that, we will calculate. No, no, my dear, this is nothing but it is a forward contract. So forward contract ko, how do you value? You know it. Accordingly, you value. And again, foreign currency forward contract, this is nothing else. Correct? Na? Foreign currency forward contract is easy to measure for him. He was thinking some other way measure. He calculated and he gave. Then I said, no, it won't work. This is not the right way. Then look, then that finance director is telling you only speak to directly him. Now, okay, I'll speak what to do. Right. It's a different way. Chalo, forget about it. Right. Next. So embedded derivative or compound financial instrument we have understood. If it is a financial asset, we already told there are business model, there is SPPI test is there, correct na? If you wanted to keep till the maturity and SPPI test is satisfying, then it is going to be amortized recast. Agree? And at the same time, one more thing, we'll go back little. In case of initial recognition, as we already mentioned, it will be measured at fair market value, and if there is any difference, it can be there, correct na? We spoke. Alright, that is depending upon what? How do you measure the fair market value? Correct na? Fair market value is measured under the level 1 input, or it will be measured under level 2 or level 3 input may if you are measuring, correct na? Here it should be directly transferred to profit, and the difference between the actual transaction amount and fair market value will be transferred to P&L. Here it can be either asset or it will be charged to profit and loss depending upon. If you are going to get future economic benefit for sure, please record as an asset. If you say no, it will be transferred to, correct? Right. What is this? A simple example for this, I will say rental deposit, correct na? Yes or no? Rental deposit. Generally rental deposit are interest free, my dear. Yes or no? Correct na? Rental deposits are interest free. Interest free hai to it is interest free, correct na? So then are you supposed to say example big number ma? See, our house rental deposits are maybe small number compared to company. Companies, big companies may be taking big space, correct na? 20 lakh, 30 lakh, 40 lakh, crores of rentals also they will pay per month, correct na? So then under that circumstance, deposit also must be running into that much only, crores only amount. Then if you do the calculation, then you will get to know the difference, right? Again, you can use the Government of India bond yield rate only, you can use it here, nothing wrong here. Right, rate of return, I mean not IRR calculation, you can go directly by the Government of India bond yield rate. Getting my point? That is perfectly all right to apply. Fine. So rental deposit ko kya karna hai yaar? It is interest free. Okay, so there is a 5 years of period will be there. Correct na? Say 1 lakh rupees is the deposit. Sir, Government of India bond rate is equal to 10% if I tell, right? Today we gave, yeah, that is equal to Y0, we gave this number. What is the journal entry will give? We will say cash account. Cash is equal to how much? 1 lakh. But deposit account will be debited. What number? That is equal to 62,100 rupees approximately will come. Okay. So what about the difference amount? Okay, 37,900. Where do you do? Debit to what account? You must have dealt this. Surely. Maybe not able to recall now. Think. Prepaid asset. Prepaid rent? No, my dear, it is not prepaid. ROUA directly. Frequently asked question of ICI guidance is there on this. This ICI guidance. Okay. Why means for the rental, for the rent is nothing but lease only now. Then lease means you must have applied already in Ind AS 116. Whatever here you must have recorded what? Obviously you must have recorded normal ROUA account debit to lease liability you must have recorded, which will deal tomorrow. Okay. On rental deposit whatever comes, no, our difference amount also should be classified as ROUA, not prepaid rent or something, no other name. It should go to directly. So your ROUA will be E number plus E number. Totally it should be ROUA. Okay. Rental deposit money also ROUA only, not anything else. Understood? Yeah. And again, we spoke already if it is employee advance to employees or loan to employees better. Loans to employees. Yeah, there is some gap number. Obviously, gap will be there. This is a like prepaid salary or something like that. You can prepaid asset or prepaid salary. You can take it and charge it. As I already told, strictly speaking, not allowed. But as per ICA, one of the question they have transferred it to prepaid asset. So you also transfer. Okay, right. This is initial recognition. Correct. Na? Then what about subsequent recognition? We have learnt, my dear, subsequent measurement. Subsequent measurement, what is that used? We learnt? Correct. Na? There are for a financial asset first. Correct. Na? Financial asset ka we told two. First one is what? Business model. Next is SPPI test. Correct. Right. So after doing this test, this thing only, you will come out with amortized cost, FET-OCI. Correct. Na? FET-PL. FET-PL. Okay, FET-PL. Our concepts will come. Hope you understood. And as I told you, there is an exception. What is the exception? A financial equity instrument. Correct. Now, investment in equity, only equity, not in derivative. Investment in equity instrument. Initially, day one only you have to decide. And whatever you have taken, that is irrevocable option. It is irrevocable option. Means once you take the option, you cannot go back. Irrevocable option means what? No reclassification. I want to reclassify. No, it is not possible. Once you decide, job is done. No reclass. Initial revocable option, it can be transferred to FET-OCI. It can be transferred to OCI. Correct, na? Right. As we already just now discussed, derivatives. Derivatives are always FET-PL. Yes, it will be FET-PL category. Derivatives are FET-PL category. Done? Correct, na? Right. So, this is first classification related. Correct? Right. Amortized cost. Yeah, you were saying something. Amortized cost, something. No, that is different to derecognition of financial liability only. Anyhow, these people also ask the same thing. We'll handle that separately, specifically. Okay, reclassification related. I think once upon a time they asked once only, not number of times. That is not repeated again and again. It is waste of time to spend too much on the reclassification. Okay, but one question we should always think: this
is a one good small revision. Transaction costs. Okay, right. We are looking at financial asset only. Transaction costs. Correct na? So transaction cost, how are you supposed to deal? Transaction cost means what? Example, processing fees. Processing fees, suppose if it is paid, registration fees, etc. Whatever, some brokerage fees. Hello, understood? Yeah. So if you are paying something, what is that we should do, my dear? How do you deal with this? Add to fair value. It is a financial asset only, and we are under financial asset. Right now under financial asset. Add to fair value, not correct exactly. Okay. It depends upon the classification first. It depends on classification. It is not straight away rule. Why? First, if it is classified as FETPL, your classification you have done right now, FETPL. If it is FETPL classification, transaction cost should be charged to P&L. Okay, right. So, but the transaction cost, it may be related to FA or it may be FL. Both concept is same. Yeah, but if you have classified it as FVTOCI or amortized cost, correct na? Right. If it is related to FA, you will add it to financial asset, correct na? So that we will say what? FA account debit to cash, whatever you have paid. Financial asset account debit to this. Okay, sir, it is a financial liability. Correct na? Anyhow, you have paid the cash. So it is financial liability is a deduction. Liability is debited. Liability deducted means it is reduced. Liability is reduced. Correct na? Yeah. You got only that much number. Right? This you need to remember. Once, that is also long ago, like 2020, 21 our time, not recent time. They gave one question with testing this concept. That's it. If it is a financial liability, if it is a correct na, it all matters. Why it will matter? In case of amortized cost, nothing matters. But if it is FET OCI concept hai to nama, correct na? If it is OCI concept, if it is a financial asset, yeah, you bought it for what? I paid 1000 rupees plus transaction cost of say 60 rupees, 1060 rupees I have paid. Today fine. But on the 31st March, the fair market value is equal to 1050 rupees. Then you should say 10 rupees is a loss to OCI. Correct? You should add it with that number. You are supposed to compare it with the fair market value on the balance sheet date. If it is amortized cost, it will automatically it is gone. No, it is part of EIR may it will be reflecting. It will reflect in EIR number. Okay, not here. If it is FETPL situation, may what would have happened? Day one only 60 is already charged to P&L. So your what is the initial recognition? Your FA initially you must have recorded FA at 1000 rupees. May you must have recorded. Now fair market value is equal to how much? 1050. Now what do you do on balance sheet date? The 50 will be transferred to P&L. Correct na? To P&L credit. Yes, financial asset will be debited by 50. Understood? Correct. That's why transaction cost is important. Right. With respect to transaction cost, he has not tested, but he can test. One small point is there. Suppose transaction cost. Okay, transaction cost related to first thing, issue of equity. Tell me, our own equity shares we are issuing. Do you issue or not? Will issue. When you issuing, do you spend some money? Yeah, you need to suppose if it is happening a public issue, so brokerage will be there. So many things will be there. It is not a small thing. Okay, cumbersome activity. A lot of money has to be spent. Correct? You are issuing. So you have paid transaction cost. Say example brokerage only, I will take it. Issue of shares. You spend some money. What is the entry you will record? How do you treat this? Question clear? Huh? 10 lakh shares issued or 10 lakh rupees ka worth of shares issued. First, basic journal entry would have recorded cash account debit to equity share capital to security premium, something like that you recorded. Is it correct? Now, this is the first entry. Now, second entry, transaction cost related to the equity shares, you must have paid to the broker. Correct na? You must have done so many other expenditure is incurred. Advertisement kiya. Yeah, advertisement karna. I am issuing, correct. Otherwise, how people will get to know that your company is issuing shares? Yes or no? Correct. No? People will not be knowing also. Na? I am coming for initial public offer. I am coming for maybe second time public offer. Right? Bolo. What do you say? How do you deal? Shall I charge it to P&L? This brokerage, advertisement, brokerage or advertisement expenditure? Not to P&L. Other equity means security premium only it should go. First, if you have security premium, will apply to security premium. Not be, if no security premium is there, negative number will sit. Okay. So that's what first security premium account debit, correct, to cash or payable. Yeah, if security premium is no security premium. If you don't have security premium, then negative. Keep it negative, that's it. You cannot adjust it with the retained earnings. Reason, it is issue of your own company shares, not some other company shares. It is not expense. It is a capital transaction. We don't do. You keep it in other equity, minus number may will keep. Okay. Some other reserves, generally security premium will be there. All other equity. It's other equity obviously. Security premium also other equity. Other equity is nothing but reserves and surplus. Simple language. One separate line item. I prefer separately showing separate line item. Okay. For confusion or something, you say other equity karke debit kar. Best option. Reserves and surplus will be debited. Simple. Which reserve don't talk if you don't know. Correct. Be diplomatic. It will continue like this. When you get the needs and then the future security premium aa gaya, so that time you can offset. In the future when it comes, that time you can offset. Till that time you hold it. Nothing wrong. Okay, your own company equity shares issue kiya to aisa. Understood? Now, suppose transaction cost related to compound financial instrument. First you saw asset related, correct na? Next you saw, I mean asset and liability both I clubbed it here, correct na? I have spoken liability also on this. When it is related to both, partially liability, partially equity, correct na? Convertible debenture situation we saw, we handled na. Then further transaction cost is incurred. Now, correct. If it is this, you have to apportion, you have to allocate. In the ratio of which ratio? Not asset and liability. Compound financial instrument means liability and equity. Correct na? Liability and equity. How you have allocated liability and equity? Correct na? 10 crores and 1 crore 9 crore karke something we did in the example mein liya na? Same way. In the ratio of allocation of equity and liability, financial liability. R ratio mein you are supposed to do it. This is transaction cost related to financial asset, financial liability. ऐसा करना पड़ेगा. Okay, right. Now let's go to what is that you wanted specifically. Derecognition can we hit directly? Any other topic important if you feel we can, I can spend Yeah, previous classification. Initially what you did, total amount 1 lakh, then minus other equity, I mean total amount minus present value of the liability you will determine. Say out of 1 lakh, 90,000 is present value of liability, 10,000 is other equity. That means 1 lakh is divided between 90 and 10 is 2, correct na? 9 is to 1 ratio में divide किया. Transaction cost also in the ratio of 9 is to 1. Liability component से cut करेगा, equity में other equity को debit करना. Again concept is same. You have to bifurcate it. Again we can write it here. Say you spend transaction cost of 10,000 rupees. Now it is bifurcated between equity and debt. That is equal to say 9,000 and 1,000. Example. Correct na? Then what are you supposed to do? To cash, I paid 10,000 rupees. Correct. Other equity account debit, that is equal to 9,000. Financial liability related, that is equal to 1,000. Financial liability related 1,000. But E level has not asked. But yes, he can ask. I told na correctly if they want to test in MCQs na, lot many concepts are there to test, especially from 109. Especially from 109. No, so much is there. 109 is a ocean. How much you dig, that much will come. Never ending. Never ending. Okay. Yeah. You know, for ECL only, people do charge 4 lakh, 5 lakh rupees will charge only for ECL computation for big company. Lot of analysis, lot of work will be there. It is not so straight and simple. So much of statistics. No, you have to create. Why it is not possible? How? Which company? Hmm. Then ECL not required. Subsequently you got the data of how full amount I have received. Then there is no point to create ECL only. You just write no. Subsequently we have not created the ECL because my entire data have been collected before I signed the financial statements, or because at the time of preparation of financial statement is not. I don't feel that something is required here. Or okay, somebody is insisting, okay, 0.05 percentage or 0.05 percentage, we'll make one ad hoc ECL, will make it. Actually not required, but still I am making something. You can do that way. But if you don't have such kind of information, like I have collected already, you have to make ECL. If it is not, at least depending upon the materiality of the situation, auditor also has to comment. Auditor may mention if it is so material item. Okay. And as I told you, ECL when you are calculating, we will consider macroeconomic factors. What is macroeconomic factor? Countries ka GDP, country ka inflation, so many other factors you have to consider. Right. I learned a lot of statistics after ECL. I was not into statistics, but yeah, it's so much relevant here. How to read that numbers? You need to have some statistical knowledge. But anyhow, it's always done by the other teams. Even Big Four also will have separate teams for this. That whoever doing the audit, no, those guys will not do. They will also depend upon the right other teams. But when ECL is done, no, what is the strategy? Is the strategy in line? Is it they are going by conservatism or moderate, or is it too much light? Correct, na? That analysis area you should have a background knowledge. One time I gave one session for Dubai only, Dubai CI. Out of 6 hours, 2 hours I spoke on this only. Luckily, I had done the same concept the very few months or few days before only was doing for one NBFC के लिए. So I had studied na, why this will come, why that will come, what is going to be impacted, which is the data required. Correct na. Afterwards, how do we determine these percentages? information calculation is not like I cannot explain you simply 1 hour. If you give also, I will not be able to explain. It will take a lot of time. It depends again. Whatever one company को I did, I will copy paste. No, नहीं होता है. This assumptions will change. Style should change. Okay, right. Good. Right. But you understood no this concept. Compound financial instruments को दे दिया तो it is going to be like this. Fine. Right. Next. Any other specifically you are looking for? Nothing. Can we go directly to derecognition? Fine. Yeah. In between, if you remember also something, you tell me. Okay, na? Nothing to worry. First and foremost thing, derecognition. Derecognition of financial liability, let me handle first. Okay, that is only you also wanted. Correct, na? Derecognition of financial liability. When I touch this derecognition, one time they asked one question, or it may be there in the institute material. If I remember, institute material, I think it's there. Initially, okay, that is not derecognition. Present value, fair value, how do you determine? Present value of the future expected cash flows. Agree, na? Okay, today you are expecting that my person will pay me 1, 2, 3, 4 करके ऐसा calculate किया. Present value correctly you got it. Now subsequently what has happened? That guy did not pay in one time, but he paid in next year. May he paid. It will be changing. What should we do then under that circumstance? Because as per the plan, it will not happen. You are supposed to pay 10,000, 10,000, 10,000 to me next 3 years. Suppose first year you paid 10,000, next year you didn't pay. That next year you paid 30,000, 20,000 rupees you paid. Are you getting my point? Pura money to aa gaya. That's a different situation. Now how do I do? If it is not happening, you have to use the existing. You already must have determined EIR, expected, sorry, effective rate of interest or effective interest rate something, correct na? Same EI rate mein future cash flows you are supposed to discount it. A difference something is there, it should be transferred to P&L, adjusting with financial asset or financial liability other part. Your number will be, because as per your initial expectation, cash flows will be changing. Timing change ho gaya to your present value calculation also will change. Present say example, okay, I'll keep this little, okay, yeah. Say initial plan, what is initial plan? Initial plan, somebody has to pay me first year, second year, third year, fourth year. Okay, 10,000 he should pay, 10,000 he should pay, 10,000 he should pay, 10,000 he should pay. But actually what has happened, okay, assume this is employee advance. What is this? Employee ka advance. Correct? I mean loan de diya. Employee loan de diya, he has to pay me 10,000, 10,000. Maybe I must have given employee loan amount is equal to 40,000 I gave loan. Interest free loan. कुछ नहीं देता, correct? He will not give any interest. 10,000, 10,000, 4 times he will pay me the money. Simple, correct? No complexity, right? Now market rate you must have taken 10%. Accordingly, you must have derived what you must have derived financial asset. Balance is prepaid asset or charge it to P&L. Correct, na? Right. So, but actually what has happened? 10,000 he paid in time. Second year he didn't pay. Next year he paid 20,000. Last year he paid 10,000. Correct, na? First year accounting correctly you must have done, not a problem. But second year kya hota? He has not paid, no. Things will change, no. Plan is changed. Correct? Now, or you may be expecting this guy will come and pay me pura 30,000 rupees, he will give me in one shot and close the loan. Possible very much. Now what should I do? You are standing on Y2. Now your future plan is changed. Correct. If future plan, whatever as per the future plan, E numbers you discount it now. Kya bola? Discount it. Discount using which rate? Original EIR rate. Correct na? Some number will come. A number, whatever number will come, E number will obviously does not match with your carrying amount. Whatever is there in the books, it will not match, na? Right. Suppose this is equal to 1000, this is equal to 950, or it may be 1050. Adjust it. Adjust in the sense, now you want to make it to 950, na? So then to financial asset, you reduce it by 50, and this difference will be charged to P&L or ulta entry. There is one question, if I remember, in ICA material. It was there. I think it is there also. Correct? This is one small concept need to remember. They can test. I don't think so they tested, but they can test. Okay. Now come to derecognition of financial liability. Now first, derecognition of financial liability when? Only when no financial liability, correct na? Extinguishment of liability. I mean, pura liability, I am no more liable to anybody. Then you are supposed to remove it. Correct? Right. But here what will happen when extinguishment of financial liability, when it takes place, means I am no more. Extinguishment means what? Closed. How will it happen? I repaid money fully, I am done. Or you who is the lender, you said it's fine, appa chodu, you are only waiving. Waiver approval has come, then I can change it. But the problem what will happen here, there can be restructuring of the loan. Restructuring of the financial liability can happen. What do you mean by restructure? Earlier loan terms are correct na? Terms, correct na? That is a change in the terms. Right. So when there is a change in the term, yes, we came and spoke, okay, earlier 10% interest is there. Now you are asking for 9%. Fine, I may give. Correct na? Maybe I may increase the little amount of loan. What you need to pay, I will increase it. I also should not lose, no? Correct? Or earlier it was 10 years. Now you are asking for me for 20 years. So some changes will be happening. Under this circumstance, what is that we need to do? First thing you have to decide whether the change, whether this change, does it amount to greater than or equal to 10% of old. Old situation, above 10% impact is there. Okay, right. If you say more than that, then it will be accounted as what? Extinguishment. Extinguishment means what? Remove the old loan, close the old loan, correct na? And account for new loan. Right. And if it is other way around, if it is less than 10%, change impacting only 9%, then what are we supposed to do? We can do simple, adjust it in the financial liability mein adjust karo. Right, adjust the difference to financial liability, right, by debiting debit or credit to P&L. Just debit or credit to P&L. Okay. Here the concept is, right, whether should I use the old EIR or new EIR, correct na? Our concepts are there. Okay. Yes, my dear. So let's look at this. So as I told you, do you satisfy the 10% test? Yes. Yes means, as you said, extinguishment accounting. Extinguishment accounting means simple. Remove the old loan, calculate the new loan. Right. So obviously, derecognize existing liability, recognize the new loan. Whenever you say new loan, na, correct. Whenever you say new loan, obviously new AIR will come. Nothing old will come. Hope you understand. Right. So recognize the gain or loss, something comes out of this, that will be transferred to profit and loss. The carrying amount of the old loan minus carrying amount of the new loan will be done. Next, these are important points, Amma. Recognize the extinguishment cost. What is extinguishment cost? they have to mention, correct? Now, because when you say that I will change the loan, correct? Now, I want to change the terms. Do you think they'll do it free of cost? Right? They will never be losing anything. Obviously, my banker is a business person. He is not a charitable trust there. Correct? Now, so end of the day, they are for what? To make profit. Maybe to make a less profit to get a goodwill, that is fine, but not with a low profit or loss. Agree? Right. So they will be changing the terms and conditions, but they will keep some different name, one fancy name they will keep, and they will charge you. End of the day, you will be losing, but okay, at least it will make you comfortable. Earlier 10 years I am supposed to pay, now I am converting it to 20 years loan. Correct? Na? So some comfort they are giving by charging. So those any re-extinguishment cost, if they have mentioned clearly in the profit and loss, that should be transferred to profit and loss. Okay, but extinguishment is what? Extinguishment of the old liability related hai to ESA. No, they have not mentioned. It may be a transaction cost related to new liability. That time that will be considered under EIR. EIR computation may it will come. So that's, don't worry. In the so far given questions may they have mentioned very clearly. So I don't expect that. Fine. So calculate a new IRR and obviously follow this prospectively. For the new loan, new IRR is supposed to be done. Agree? Right. First, 10% how do you calculate? Can you tell me? How do you calculate 10%? This is the first question. 10% test is there, na? Impact you are supposed to give. Impact you have to give means, how do you give? What by what are you supposed to consider? Huh? Sorry? Correct. First thing, what is the existing debt ka? Okay. If you, what is that now from today onwards, as per the old terms and conditions, how much are we supposed to pay? Cash flows you determine. That you are supposed to bring it into the present value. Which using which rate? Huh? Original rate. Okay, done. Next what? Next what are you supposed to do? Charges are, forget. Charges will not be considered for this calculation purpose. Percentage, how do we get? Basically, new number minus old number divided by old number. Simple calculation I am telling. Correct na? Any change, 100 rupees became 120 means what do you do? 120 minus 100 divided by 100 because base is old number. Is the simple rule understood? Correct na? So here also same way. But here but this is only for a calculation, calculating what 10% KLA. But this is not for accounting purpose. This is to determine whether your accounting will fall this side or accounting will fall that side. That's all. Is that clear? Right. So let me, right. Okay. Let me read through the thing. Forget of this. The fees paid for the above purpose include the amount paid by the borrower to on behalf of the lender, and the fees received includes, okay fine, this is ignore it. Directly I will take you to the question will speak better. Okay, some practice question number 42. This may be there, I think what you are showing me also same question approximately, but terms and conditions will be same, number may not be same. Okay, concept will be same, concept cannot be changed. Observe, if not 42 will go to 43 also. Fine. So 42, 43 both we can clear it. Say on 1st January 2020-21, XYZ Limited issued 10-year bond for 10 lakh rupees, bearing interest at 10%. Okay, right. Payable annually on 31st December each year. What is annually? 10% interest will be, I mean monthly, annually you will pay the interest. Principal will be paid at the end. The bonds are redeemable on 31st December 2000, whatever 2010, whatever. Okay. Then that is for 10 lakh. At the end of the 10th year, you will pay that number. Correct? No costs or fees are incurred. No costs or no fees is incurred means what? No transaction costs are there initially. Correct? No TC is there means what? Coupon rate is the EIR. Correct? Now that is first point should come to mind. Correct? Na? When the loan rate will EIR will change. EIR will change only because of the transaction cost only. If transaction costs are not there means EIR is same. Coupon and EIR both are one and the same. Point to be noted. That's why they only told effective rate of interest is 10%. Even if they delete this line also, you should catch it. That is what I mean to say. Question, they are very kind enough. They gave that data. Got it? Right. Next. On 1st January 2016 or 26, whatever it is. This guy came, that is after 5 years. This guy came and said like modification we want. Fine. Yeah. What happened? 16 means this is 21. This is 26 or 11. X number you replace either 1 or 2. That is your choice left to you. Okay. That is dash. You fill the blank. Right. The term is extended to 31st December 2032. You can take it. Are you getting my point? Right. 2 will become 3. Here 2000, 2021, 2026. This is 2032. Got it? Normally you should have paid by. So 30 May you should have paid it, but you are not paying by 30. Correct? 1st January. Oh, sorry. Yeah, 1st January they diya na. I thought 1st April. That's where the problem. But doesn't matter. 1st January to 2030 is correct number. Correct na? You got it? Confused with dates. 1st January 1/1/2020. Date of loan. Date of redemption when it will happen? 31st December 2030. Is it correct? Any problem? Yeah, that is 31st 2020. E number, that is a typing problem. See, year cannot be 5 digit number. So that means wrong is there. That's all. Okay, that is a typing problem. Hope you understood. It should be what na? I mean, when even though sometime we will instruct, it will not happen. It should be 20y0. It should be written because x you considered as 2, y will be 3. That is the right way. It didn't happen. Okay, right. So I can't do right now. Only correction here. I hope you understood. Right. Next. On which day this guy has come? 1/1/2026 he has come. From here to here, how many years are done? 5 years are completed. Because 1st January to 1st January. Agree na? Right. 31st December 25 is nothing but 1st January 26. 1 day only delay. Correct na? So it is 5 years completed. That is what the situation. 1st January 2025, after 5 years, our persons have agreed to the following modification. What is the modification? Term is extended by 2 years. 30 को पे करना, correct ना? 31st December 32 में 2 more years extra कर दिया. Total 12 years. What I was telling, extended by 2 years. Done. Interest payment will be reduced to 5% per annum. Now onwards, how much do you pay? 5% only you will pay. Done. The bonds are redeemable at the end of this date. Okay. This date for what number, my dear? 15 lakh. Actually, you have given it for how much? 10 lakh. He is losing 5% na? 10% initially agreed. Now you are paying 5% means why is a bakra? Correct. Now obviously amount he is going to get the premium amount. Redemption will happen at a, you have to redeem me at 15 lakh. 5 lakh rupees compensation indirectly. Done. Legal and other fees 1 lakh rupees is incurred. Okay, done. XYZ Limited determines that the market rate of interest on 1st January 2026 for a borrowing a similar rate is equal to 11% he is giving. Market rate is 11%, not 5%, because you have given a new rate of what rate, my dear? 5% को दे दिया ना. 5% cannot be market rate. That is not arm's length. Okay, right. Whatever, we'll see that. This is the situation, my dear. First thing, what are we supposed to determine? Is it 10% change or not? Correct. For 10% change. Okay. So in the given question, both the coupon and effective for the situation 1 is 10%, which we spoke. So the carrying amount of the principal at the end of the correct na, on the date of change, that is 1/1/2026, carrying amount of the loan would have been 10 lakh rupees only. He must have paid interest yesterday, that is 31st December 2025. He must have paid interest. So carrying amount and principal would have been same. I don't need to do amortized cost and table, I don't need to calculate. Clear? Done. Next, at first we need to determine whether the effect of the change, is it substantial, that is it greater than 10% or not. Done, right? So first, what are we supposed to do? Right, present value of the cash flows under the new terms. Right, what is I told him? 100 rupees is becoming 120 rupees, means what am I doing? 120 minus 100 divided by 100. This is our simple formula. Right, what is 120? New thing, correct na? New thing. What is that we should do? Present value of the cash flows under new terms. New things, that is, what is that? 10 lakh into 5% means 50,000, 50,000, 50,000 you have to pay for 7 years. Correct na? That means 0 to 7 years, how much do you pay? 50,000 per annum you should pay. And in the 7th year, how much should you pay? 15 lakh rupees you have to pay, not 10 lakh rupees as per the new terms. Correct? Including any receipt of fees or something. Right? Are you going to pay 0? Why 0? Are you going to pay 1 lakh rupees of this fees also? If it is legal and other fees, I am assuming this is part of restructuring only. Okay, no. Part of the new loan. What is this? Part of the new loan, not extinguishment of the old loan. Extinguishment of old loan means it will be charged to P&L. It is part of the new loan. This is for new loan. That's why new loan case course karana, right? E number, correct na? E number you are to determine using the which rate ma? Okay, is equal or greater than 10% of the, no, old rate only we should apply, correct? That's where you were telling 10%, correct? Sorry, new rate karke you were telling, correct? No? Exactly, that's what I agree. No, but I heard new rate, I heard sometime between. That's where I was also not very clear, comfortable. Fine. Chodo. E number is nothing but 10 lakh rupees. Do you agree first of all? It will be 10 lakh because old terms, old rate means yes. This one I am going to use by my old rate, 10% EIR, correct? Na? And E number, if I use a different rate of 11% or 12%, no, then how comparison can happen? Correct na? Comparison cannot happen. That is a basic rule which you need to keep in mind. So here 10%, here also you are supposed to apply the 10%. Clear? Right. So now my carrying amount of the old loan is equal to 10 lakh. Correct na? What is my future cash flows of the old loan? What is my future cash flows of old loan is how much? As per the old terms, you are supposed to give 1 lakh, 1 lakh. Correct na? Interest amount 1 lakh, 1 lakh. That is for 0 to 5 years. And in the 5th year, 10 lakh rupees you are supposed to pay. 0 mein nothing, you are not going to pay because I have considered the 1 lakh rupees for the new loan ke liye consider, not for the old loan closer. Hello, correct? Right. If you discount it at the rate of 10%, again it will come to 10 lakh. Present value of this will come to what? 10 lakh. Why? 10 lakh into 10%, you have got this number. No? When you again discount with 10% back, it will come to same number only. No, how can it go to some different number? Agree? So that is the first basic concept. I hope this is clear. Right? So what is your formula? Present value of new terms and conditions using old EIR minus, correct na? Present value of old terms and conditions using obviously old EIR divided by E number. Present value of old terms and conditions using old rate into 100, that is for percentage purpose. Okay. Now first when you write it, when your sentences are clear, na, I mean confusion will not happen later. Got it? Right. So now in this question what is going to happen? E number 10 lakh rupees I know because I told na old terms other rate you multiply again discount it other rate will come 10 lakh only will come, it cannot be more than 10 lakh. This also will be 10 lakh. Correct na? The only question is E number. E number के लिए we have already, I mean basic calculation 0 to 7 years E number, correct na? E calculation is already done here. Observe 0 1 lakh rupees I should pay, 1 to 7 years I should pay 50,000, 7th year 15 lakh rupees I am supposed to pay, correct है? Yeah, E present value कितना आ गया? 11 lakh 13,000 rupees I got it. So 11 lakh, correct na? 11 lakh 13,000 rupees when I get. So that is equal to 1 lakh 13,000 rupees divided by 10 lakh, that is equal to 11.3 percentage will come, correct na? Which is obviously greater than 10 percentage. So this is extinguishment accounting is applicable. Are you comfortable so far at least? No problem, no? Right. So extinguishment accounting. Under extinguishment accounting, what is that we told? Close old loan. Old loan, what is the carrying amount? 10 lakh. So loan account debit or debentures account debit by 10 lakh rupees. Clear? Right. Where are we? Here. Yeah. Here do we again first. Again new loan you are supposed to recognize. New loan ko again our standard you have to recognize. What is the standard? New loan has to come at fair market value. Correct na? Right. So when this comes at fair market value, fair market value means it should be at the fair rate. At actually 5% is whatever you are giving. Is it fair or unfair? Unfair, correct na? Market rate is how much? 11%. 11%. Market rate is 11 percentage. Correct na? They told market interest rate is on this date 11 percentage. But you gave at 5%. So this is not at arm's length. So that's why apply 11 percentage and determine the value. So first what are we doing? Loan account debit. 10 lakh rupees clear. Debenture or loan. So now are you supposed to record a new loan of FL? New loan are you supposed to record? Correct. New loan ka that is Ind AS 109. Any new liability you are creating, financial liability, financial asset initially should be at fair market value. So now tell me ma, new loan ka what is the point here? What is the future cash flows? Correct. Now what are the future cash flows you have to consider? How much are you considering future cash flows? I have to pay interest. 1 second. This 15 is the typing error. You multiply 10,000 into this will not come to 7 lakh, it will come to 4 lakh 81,000. This typing error. You apply 15 lakh into 0.481. That's the typing issue. Okay, right. So that is 7 lakh 22,000 the correct number. Okay, E number is 15 lakh. That is a typing error, forget. Question 10 lakh if you take it, 10 lakh into 0.481 will come 4 lakh 81,000. No, cannot be 7 lakh number. So that is obviously 15 lakh rupees number. Okay, 15 lakh. How much is your new loan number, my dear? Right, 9 lakh 58,097 is my number. Correct na? So then is there a difference or not? Yes, our difference will be transferred to profit. Yeah, here it will be transferred to profit and loss. How much? 42,000 or 41,000 something will come. Okay, that's all. Other 41,000 rupees will be your gain or loss. Again, legal fees will be charged to profit and loss directly. Done? I hope this is clear. Right. One more concept you learn, right? With respect to the other concept. Yeah, E concept you listen first. If it is no, what do you mean by no? It is not crossing the 10 percentage criteria, correct na? If it is not 10 percentage criteria, there actually guidance is not there. That is a problem. Okay, approach number 1, approach number 2 करके this is not given by the standard ऐसा नहीं, clarity में ऐसा नहीं बोला. Extinguishment account will not be followed, that's all they told. Okay, but what to be followed they have not told. Right, that's where approach number 1, approach number 2 will come. Fine. Approach number 1, listen carefully. Recognition of gain or loss on the date of modification. What are we supposed to do? Mostly, okay, fine, that doesn't matter. Gain or loss of that will be transferred to profit and loss. What is the gain or loss? Present value of the remaining cash flows of the original loan minus present value of the remaining cash flows of the new loan will be correct. Na? Discount both using the right. Key concept generally I to don't follow, will generally follow the second method. Approach number 2. Let's listen this one only directly. Okay, recalculate the effective rate of interest and apply the prospectively. First concept means, what do you mean by this? Key point. As per the agreement, what are all the future cash flows? Do you know or not? New terms and conditions, you know. The new terms and conditions ko, what are we supposed to do? How much loan has come, Nana? Suppose assume ide question, correct na? Where is this question here? Here, sorry. The question, if I say this is not 10 percentage, now this is 9% करके assumption ले लो. How do you account? That's all. Correct na? How do you account then? What is existing number? 10 lakh, no. 10 lakh is existing number. And as per the old new loan is what? 9,58,000. Right. Now look at the, refer the text. Recalculate effective rate of interest and apply that prospectively. Okay. Right. If the given rate is 11 percentage, will not be applicable. 11% rate will be applicable. You can, it is an indirect way of catching the question directly. Whenever he gives 11% or 12% like that specific rate ge diya to na, that is obviously about 10% karke you can conclude reading the question itself. You understand? Because 11% number is not required to me if it is not a new loan is going to come in. Have you understood what I said? One more time I will repeat. 11% why do you need? Present value of the new loan to calculate 11% is required. That means answer is going to be more than 10% and the extinguishment accounting is going to come in. If it is not extinguishment accounting, EIR will change. What is EIR? Example, okay, effective rate of interest, right? Effective rate of interest may, we will be, right, read the line, E line, if you catch something I can tell. Forget about the apply, yeah, only first line. Recalculate effective rate of interest. Means, here you should read it like this, okay. How do I read? 10 lakh rupees is the loan taken today. 10 lakh rupees loan taken. Okay. What you are supposed to give? What you are supposed to give? 50,000 rupees per annum you should give. That is for 0 to 7 years. Correct. And 7th year you are supposed to pay 15 lakh. 10 lakh rupees is inflow of money. 10th 50,000 and 15 lakh rupees is outflow of money. Okay. Now you have to calculate EIR for this. You can't calculate. It has to be given in the question. I hope you understand. When it is when you are calculating EIR, you don't need to refer the market rate. Market rate is not required. Everywhere market rate is not the EIR. Normally what do we consider? EIR new loan comes no fair market value में recognize करना. When it is a fair market value, then fair market rate is required. And here, are we removing the old loan, or are we continuing with the new old loan? Continuing with the old loan. That means you are not recognizing a new loan. When you are not recognizing a new loan, why do you need a new market rate? Correct, na? So 11% is irrelevant to you. Correct. Now, EIR is supposed to compute. EIR is nothing but IRR. Whenever anybody wants to compute IRR, what is the basic information you want? Inflow of money how much, outflow of money is how much. That's all we need. Correct, na? What is IRR? It is the rate at which present value of inflows and cash inflows will be equal. Correct, na? Right? So, IRR computation purpose, we don't need the market rate. Got it? So, 11% irrelevant karke already concluded. Any question? No question. That's all what I am telling. 10 lakh rupees is my inflow. Assume you got a new loan at 10 lakh rupees. Paisa hai already is given. Na? Received 10 lakh. And as per this agreement, you have to pay 50,000 per annum for 7 years. 15 lakh rupees you are supposed to pay for at the end of the 7th year. Hello, correct? Right. Now, what is the new rate of interest will come? Are you getting my point? Just you need to calculate the EIR, right? That is what the concept here. And whatever the new rate comes in. Sorry? Yes, new terms and obviously new terms and conditions. New cash flows only I have considered. For a new cash flow, existing loan. EIR will change. Earlier was 10%. Now it is obviously no more 10%. It will come to 12%, 13%. Okay. So your 10 lakh rupees, as per the new rate if I apply, no, it will become 15 lakh rupees by the end of 7th year. Correct. And if you have paid any fees or anything, no, that also you will consider, you will cut it. Means 10 lakh rupees loan. Suppose 1 lakh rupees I have given as a fees. Then what you should say? What you should say? I received only 9 lakh. Because 10 lakh is the loan, 1 lakh is transaction fees I paid. That means net what is there in my pocket? 9 lakh. For this 9 lakh, I have to pay 50,000 and 15 lakh rupees at later point of time. That will be considered for EIR computation. Now you should say my inflow of money is 9 lakh, my outflow of money is this much. So at what rate both will be equal? Our rate apply karo. Your 9 lakh rupees, by applying the rate, by end of the 7th year, it will come to 15 lakh rupees, repay the loan. That's all it will happen. Okay. Yes, in exam also, in another way also, generally people do follow approach number 2. Approach number 2. If it is not a substantial modification. Right. These two approaches are given by ICA only, not by me. Okay. These are both the approaches are valid. Again, which one should I follow? Actually, standard is silent. That's why they also don't ask again and again. Okay, because everybody will follow their own approaches. That is complicating. Fine. Too many alternative ways I have to provide. Understood? Right. Next, any other point, Amma? FGC. Can we spend some time? FGC. What is FGC? Financial Guarantee Contract. I think they have never asked a question. Correct, no? Or they asked. RTP question was there once. FGC, only RTP question was there. Not a right. I mean, they have never asked in the examination. That's what I believe. But RTP question, one beautiful question is there. No doubt. But that is not the only way. FGC calculation kona practically one company one tara they'll do. But all are valuable. Because standard will never tell. Standard will tell fair value karke bolega. It will not tell how to measure the fair value again. So many different ways may we do follow. Okay, right. FGC, first of all, initial recognition. Yeah, initial recognition of FGC. How will it happen, my dear? Initial recognition. Initial recognition, it is like a financial liability. It will be at fair market value of the financial liability. It is a financial liability, we will treat it. Okay, right, financial liability. But what is happening exactly? Okay, there is a holding company, there is a subsidiary company, there is a banker or lender, whoever. Bank will give a loan, correct na? Right, H will give a guarantee. Now we are in the books of, we are in the books of what? We are in the books of H, correct na? Holding company books mein we are. Earlier old rule is what? Old rule is contingent liability mein we show. Contingent liability mein we show, correct? Is that old rule is still existing? No. Under Ind AS, no. That is AS may correct. So now what are we supposed to record? Financial liability. Normally what happens? First question number 1. Okay, is it paid? Is any charges received by holding company, I can say. Or any charges received by holding company, correct? Answer can be yes or no. If I say yes, I am telling assume at fair market value only he gave. Sometimes what happens? Normally, if anybody wants a guarantee from a bank guarantee if you want, 10 lakh rupees ko bank guarantee you want. If you approach your HDFC, Axis Bank or anybody, na, will they give free of cost? Will they charge something? They charge 0.75 to 1% they will charge. Even though your bank account is with them, your fixed deposits are with them, 10 lakh rupees is not a big number for your account, correct na? Huge transactions are taking place, still they will ask. Getting my point? And if you have FDs, pledge of FD also will happen. Means what? Riskless. Still they will take that, correct? Let them take, that's a business. Because other party wanted some guarantee. That's why I have to give the guarantee. Correct. So 1% is it calculated or not? Right. So generally what do we do? Suppose 100 crore rupees of money into 1%. Some companies, what do they do? Sir, if a banker had given this guarantee, they would have charged 1%. So correct na? Right. If it is collected money, 1% is collected, not a problem. What do we say? We will say cash account debit, 1 CR, example, correct na? Collected cash. Getting my point? 2. Financial liability or FGC contract, correct? 1 crore rupees will record it. When collected money. Hello, understood? Right. If you say no, sir, it is not collected, then what do you do? It is given to whom? Your guarantee given to whom? On behalf of subsidiary only you gave a guarantee. So what should I record then? But the subsidiary has not paid me 1 rupee. Normally nobody will pay. Rarely only people will pay. What is the entry you should record? Doesn't pay the loan, that is future. You are today, you are at initial recognition. Question I will repeat. This is initial recognition. H has given a guarantee to the banker on behalf of S. Yes. Question is what? Are there any charges received by the holding company? Who will receive? H. From whom? Holding company will get from whom? Subsidiary company se aana. Correct na? Right. Situation number 1, you got money from subsidiary company, paid you 1 crore rupees. Example. It will never happen. It's a theoretical concept. 99% they will not pay. Correct na? No. Now what is that situation? They have not paid you 1 rupee, but they gave a guarantee to you on behalf of subsidiary. They gave a guarantee to the banker, but subsidiary has not paid 1 paisa also. Now what should I do? Charge it means what? P&L. P&L is not a right way. We will record like investment in subsidiary account debit 1 CR to financial liability, that is FGC. We will record 1 CR. Okay, right. How did I get this fair value? If banker had charged, banker would have charged 1% on the total loan. That's why I also have calculated like that. Hello, correct? Right. But some people, okay, it's not. Now I am calculating whether 1 CR okay na not okay na. For that purpose I am telling. 1 CR ko how do we calculate? One thumb rule will follow. Okay. Bank given which rate? Bank rate of interest. Bank rate of interest. Say example, bank is charging 12% to my subsidiary. This is with guarantee. What is this? With guarantee. Suppose now without guarantee, क्या बोला? Without guarantee, that is going to be 13% assumption. Right. That means, have you got a benefit of 1%? Correct, na? Have you got a percent of 1%? So suppose it is a 3 years loan agreement, assume. Correct, na? So 100 CR. 100 CR is the loan amount. So year 1, what is the benefit to you? 1% means 1 crore, na? Correct, na? 1% is 1 crore, 1 crore, 1 crore. Is it a beneficial to you? And at the rate of 13%, you are supposed to discount it. Correct, market rate. Plain market rate is 13%. Now, do you get a present value number? Present value cash flows will come. Correct. Our number is, instead of keeping 1 crore here, right? How much you got, ma'am? 13% means 13% GTO apply. Okay, 2.3612. That is equal to how much, Nanna? 2 crore 36 lakhs will come. Correct, na? 2 crore 30, in the place of 1 crore rupees, you will record 2.36 crore. 2.36 crore you will record. Hello, correct? Now, listen carefully, not over. This is initial recognition. Kya bola? Initial recognition is 2.36. At the end of the first year, what will happen? At the end of the first year. You recorded financial liability करके record कर दिया. Investment account debit to financial liability record कर दिया. Correct ना? How much? 2.36 crore you have recorded. Now what to do? Recalculate the you have to unwind also, you have to do amortization also. Both are there actually. Yeah, I'll tell you. Okay, right. Listen carefully. E 2.36 ka is a financial liability. Correct na? Financial liability means which method you should follow again here. They say in one of the question given by the RTP, again they calculate amortized cost. Directly can I show you the question? Best option for you. Correct, no? Otherwise, I have to calculate. SGP कहाँ पे गया यार? Just give me few seconds. Hedge accounting. FGC. Yeah, this is the question. It was asked, my dear. I thought it was a RTP question. It was asked. Okay, this will help you to cover full FGC concept, pura initial recognition, subsequent measurement, everything will be covered. Okay, right. Listen to me carefully. We'll close this. Concept capsule 26. 1st April 2021, some limited guarantees. Correct, na? Yeah. He gives a guarantee of 10 lakh rupees loan of subsidiary, Moon Limited, which bank STDK has provided to Moon Limited for a 3 years at the rate of 8%. A bank has given a loan to Moon Limited. My son Limited has given a guarantee for that in simple terms. Amount of loan is equal to 10%, 10 lakh rupees, and rate of interest is equal to 8%. Correct? Done. Interest payments are made at the end of the each year. Principal will be paid at the end of the 3rd year. If the Sun Limited has not issued the guarantee, see, Sun Limited has not given the guarantee, the bank STDK, whatever, would have charged the Moon Limited at 11%. Means Sun Limited is enjoying 3% benefit because of the loan. Correct? So, the 3% is nothing but how much? 10 lakh into 3% how much? 30,000 amma. Okay, 30,000. 30,000, 30,000, 30,000. 3 years are you getting the benefit or not? Exactly. Sun Limited does not charge any amount to Moon Limited. Holding company only, na? They won't charge anything. Have you understood? Done. On 31st March 2022, means after first 1 year, there is 1% probability that Moon Limited may default the loan in the next 12 months. Why? This is nothing but ECL. I'll tell that also. Let me come to that level. If Moon Limited defaults the loan, Sun Limited does not expect to recover any amount from the Moon Limited. Again, for this you need to remember ECL thoda concept. I'll revise that also. Okay, it will not take too much time. And next year, there is 3% probability that Moon Limited will default. That time also will not get any money. I mean, in the sense what? In case Moon Limited defaults, Moon Limited is not able to pay. Okay, bank ko I will pay, but I cannot collect 1 rupee also from Moon, he is telling. Are you getting my point? What is my loss? Pura 10 lakh rupees will be my loss. But to occur that incident, only 3% chance is there. What is chance? 3%. So what is your maximum loss, my dear? 10 lakh into 3%. 10 lakh into 3% is how much? 30,000 rupees. Okay. Probability of default is 3%. To occur, I mean to incident that occur. Correct, na? How much is your loss? Pura 10 lakh. Suppose example 10 lakh rupees I gave a loan to him. In case of default, I will go and catch him. I will catch his property. Correct, na? Out of 10 lakh rupees, I will collect 6 lakh rupees. Means 4 lakh is lost to me. Correct. 4 lakh pakka you will lose. In case if he defaults, then 4 lakh is lost. But to default 4 lakh, to default 3% chance is there. So 3% into 4 lakh rupees I should apply. Okay, right. Fine. Provide the accounting treatment of the financial guarantee as per Ind AS 109, initial recognition, subsequent measurement, everything you tell karke he is telling. Correct, na? Right. First simple concept, amma. Have you got a interest benefit of every year, 3 years, year 1, year 2, year 3? Correct, na? This is year 3. Have you got 30,000 rupees, 30,000 rupees, 30,000 rupees, totally 90,000 rupees? Have you got a benefit out of this? Correct. Next. And as I already just now I told, correct, na? What is that I told? You have to discount it. Correct, na? Present value of the benefit. Benefit means market rate you should consider. Have I told you? Correct. What is the market rate, my dear? Market rate they gave no here. 11% karke they only told. So that's why. So market discount it at the rate of 10%. So 30,000, 30,000, 30,000. Total discounting kiya to 73,320 will come. So what is the first journal entry you should record? Investment in the subsidiary account debit to financial liability. How much number? 73,320. Is it clear? Okay, over. That's what. Investment in subsidiary account debit to financial guarantee contract or financial liability, you recorded 73,200. Till this level clear? Right. Now, next question, what should happen? How do you handle the 73,320? Correct na? Liability you created na? What do you do with this? First thing, you are supposed to amortize it. Kya karna? Amortize. Amortize for 3 years. Transfer it to income. Liability na? Liability reduction is an income. Hello, understood? How do you amortize it? 30,000, 30,000, 30,000 only I will amortize it. But since it is a liability, I will follow amortized cost method as well. What do I follow? Amortized cost method I should follow. Alright, this is exam question. Correct na? Answer also given by ICIA, not by me. Okay, right? This is, I thought like they never asked. I thought RTP question. That's why I thought I will not focus. Okay, luckily we opened the question and we identified. Got it? Right. Now look at the table. What is opening balance? Correct. Amortized cost means opening balance, interest at the rate of 11%. Right. Amortization. Payment will not happen here. Amortization will happen. What will happen? Amortization. Then closing balance will come. Correct? So now, E 73,000 ko, what is the next journal entry at the end of the year 1? We'll record FGC account debit to income. Where do you transfer? Income. How much number do you transfer? 30,000, 30,000. Like that, all 30,000, okay, will record over the period of 3 years. 90,000 will go off. Hello, correct? Right. But hold on, look at the table. Observe. Okay, what is observation here? 73,000 is the opening balance. At what rate you discounted? 11%. Then add back. Unwinding karna. 8,000. How much is you are reducing the FGC na? In this above entry, are you debiting or not? Debiting means reducing only na? Yeah, this is EIR. Here you are adding, here you are deducting. This is the closing balance. How much is the closing balance now, my dear? Correct. So now you have to keep two numbers aside. What is the two number? First number 51,385 karke rakha idhar. Correct na? Next, listen. Subsequent measurement of FGC. Second point. What is ECL? Karke bola. Kya bola? Expected credit loss. What is expected credit loss? Where are we? At the end of first year. Correct na? That is as on 31st March 2022. First, if loss occur, how much is your loss? If default occurred, can you read this para? No, you didn't answer question. Read the line. What is he saying, ma? Second line is more important. We can't get 1 rupee from their property. If the default really occurs, pura 10 lakh rupees gaya. Hello, understood? So 10 lakh rupees into 10 lakh, correct na? 10 lakh means E number. Whatever. 10 lakh into how much is your recoverability? Generally, what do we do? -1 minus 0%. 30% recovery ho sakta, sir. Means 1 minus 0.3 I will keep. Means 70% is my loss. Hello, understood? So here 1 minus 0 means 1. 1 means pura. Into probability of default you have to apply. What is the probability of default? Correct? Are you getting my point? Yeah. What is this? This is the exposed amount. What is this? Exposed amount. Right. What is the loss at given default? LDG we call. LGD we call. And this is PD, probability of default. Okay. What is the probability of default, my dear? 1%. 1% means how much? 10,000 will come. Agree? Yeah. Hello, understood? Now you come to here. E situation may 10,000. Whichever is higher should continue in the balance sheet. Whichever is higher should continue in the balance sheet. Already now, right now, how much is there in the balance sheet? Liability, how much is there? 51,000 is there. And if the loss happens, how much will happen? 10,000. It's anyhow low. Already I am keeping a higher liability in the balance sheet. What should I do? Don't need to do anything. Correct? Right. So what is the difference? Which date? E date. So 51,385 is higher than the expected credit loss of 10,000. Correct. So the liability there is to be adjusted to 51,000. I mean it will continue to the same 51,000 rupees. को continue करेंगे, कुछ नहीं करेंगे. Hello, understood? Right. Now come to second year. Second year, the first what should I do? This is for first year. Agree na? Now second year. Second year ko what is the carrying amount? E51,000 plus EIR minus 30,000, 27,000 rupees I am keeping here. 27,037. Correct? Hello? Understood? Correct. Now what should I do now? Again ECL I should calculate na. What is the ECL now? Ajao. ECL. Now PD is now same sentence. EE paragraph you read it. Now also answer is what? I will not be able to recover. Correct? 1 minus 0 only. But to occur this situation, it is 3%. 3% means how much number will come? 30,000 number will come. Correct? So if 30,000 number comes, whichever is higher should be there. 30,000 should be there. Correct? But how much is there already? 27,000 is there. So round figure 3,000 rupees I have to additionally charge now. Expense account debit to फाइनेंशियल गारंटी कॉन्ट्रैक्ट करके 30,000 को लेके आना. Have you understood point? That is what it happens, my dear. Okay, yeah. Why they got 21,780? Correct na? How? Adu correct. Okay, they have missed out this one. What is that they missed out? What should you do actually? E number minus E number. How much will come? Here there are two things. Now, what is the entry for this? Interest expense account debit to liability. Correct na? That is equal to 5652. Agree? Yeah? Right. Next, loss account debit 3,000 rupees. Agree? Yeah? To financial liability 3,000. Do you agree? Correct. Next, E 30,000 ka journal entry is what? FL account debit to P&L. That is equal to 30,000. Every year we will record, just now I wrote na here, FGC account debit to, there is an income, there is two expenditure. What is the two expenditure? First expenditure is interest expenditure. Second expenditure is e-loss expenditure. Hello, correct? So now tell me, calculator you use it now. How much is expenditure? 5652 plus 3,000. How much does it come? 8652. 8652 minus 30,000 is equal to how much? Number. He clubbed the next net amount he transferred to P&L. Instead of interest also will go to P&L, loss also will go to P&L, this also. But he is not right. Why? Interest should go to interest only, loss should go to loss only, income should go to income only. You cannot like all are going to P&L karke, aisa club karke. You shouldn't do that way. Fine. His presentation is not okay. You understood my point? Okay, you learnt one small concept of FGC. That is how it happens. Okay. No, practically we do calculate probability of default. Probability of default we will calculate loss at given default. Loss at given default means if the default occur, what is my loss? That is 1 minus 0 is what loss? 1 minus recovery, 1 minus R we call. That is 1 minus recovery rate. 10 lakh rupees में 3 lakh वसूल कर सकता. Okay, that means 30% I am able to recover. So 10 lakh into 1 minus 0.37. Understood? 70% is loss. That is 7 lakh. 7 lakh will be the loss if the default occurs. Our default occur chances are only 1% or 2%, 3%. Like that. Okay. Again, he used the word here. Here, what is the word he used? If you, if you go by very seriously, na, ECL ka ECL. Let's spend few minutes, some 5-10 minutes we'll spend, not more than that. ECL, 3 stages of ECL will be there. Expected credit losses. Okay. In exam, they may give you directly percentages. They cannot ask you to calculate all the percentages, which will take like 2 years to understand. Okay. And obviously you need to do means 20 hours you have to work. 20 hours में नहीं होता, 40-50 hours if you work, no, big company को, that also will not happen. So much of background calculation should take place. I told, lot of, first you, just for understanding, it is out of syllabus. Just listen, just since I am saying you are listening, that's all, nothing else. Nothing will come in examination. Okay. TTC PD करके will calculate. क्या बोला? हाँ, TTC PD. What is TTC means? Through the cycle PD. Through the cycle PD means means probability of default. Through the cycle. T for through, D for TH, the correctness cycle means actual PD, how much, that is historical PD. What is it called? Historical PD. Historical PD means past, you read, na? Suppose your company started giving loans, suppose it is an NBFC, I am giving loans to all of you, lakhs of people को loan दे रहा है, correct ना? Right. I have got a data of last 5-6 years का data है, क्या है? 5-6 years का data. So 5-6 years में what is exactly the probability of default occurred? Can we calculate? We can calculate. First year में some percentage of default, second year में another percentage. We can use weighted average rate we can apply, or average, simple average may apply. I can say E type of loans ko, correct? E type of loans ko, this is my probability of default. Actually happened, correct na? Actually happened does not mean that that only will be repeating in the future. It may not happen, correct na? That's why what do? We mix the macroeconomic factor karke I told. What is that I apply? Macroeconomic factor. Okay, right. Simple logic I will tell. So much deep not required to you. Simple. Loans are there. How many people को I give? Sir, 1 crore people को loan दिया. 1 crore number of loans I am talking. I am not talking about the amount of loan. Only number of, how many people को दे दिया? 1 crore को दे दिया. How do you calculate the movement? It's not easy. Correct na? That is where we need to, go by little higher level assumptions you are supposed to take it. Now, probability of default. Suppose GDP is there. Whether the GDP will have impact on the default by the loan taken, impact will be there or not? Impact will be there. Why impact will be there? GDP is more, GDP is growing, means probability default will fall down, reduce, correct na? Because people are earning money, people have jobs, people are earning money, correct na? India is earning money means opportunities also will be there for me to get the money. Agree? Yeah? Exactly. So there is a probability of default will come down. Suppose inflation, if I take it, inflation is going up, default also goes up. Agree na? Right. So these two are very high level factors, macro level factor, not a personal level factor. It is macro level factor. Correct na? Macro level factor ko we have to merge by applying so many statistical formulas ko apply karke, mini max formula, so many are there. Okay, forget about all those things. Apply karke we will calculate PIT PD we call. What is PIT PD? Point in time PD. This is the expected PD. What is this? Expected real probability of default. This will be applied. Again, we keep this number aside. Then loss given at default means recovery rate. How do you calculate? Right? How do we calculate? We'll check the back data. Okay, how many people became default? Our recovery team will be there na. How much we were able to collect it from all those guys. That also will take for last 5 years ka data. how many became default, how much we could collect it. Percentage we can derive there. Overall this many people का गया, इतना collect किया. So 30% I could collect. That is also weighted average. Some formulas will be applied there, right? Assume that same rate I'm able to recover it. A number separately you have to bring it. Then we have to apply all these concepts. Okay, right? But it is not when I explain in 1 minute. No, it is not that simple. That much you should catch. Lot of effort and time is required. Now come to ECL concept which I was trying to explain. Okay, right. ECL is into what, my dear? I told 3 stages of ECL. Okay, right. Stage number 1. Stage number 1 is what? I don't have any problem with I gave a loan to some party. Ma. Okay, na? Right. Do you have any problem? No problem. This guy is giving properly. I mean, in time mein paisa de raha hai. Are you getting my point? Has he become NPA? No, no. Has not become NPA. Is good. Means standard asset. Time mein money is coming. Correct, na? That is called stage 1. What is it called? Stage 1. Okay. Stage 1 mein what do we calculate? 12 months ECL will calculate. What is 12 months ECL, sir? 12 months ECL means 12 months expected credit loss. Means what? What is the probability, okay, that this guy will default in the 12 months period? Maybe I have given a loan for 5 years. Have you understood my point? What did I say? One more question. Lifetime ECL, next word I will use it. What do I use? Lifetime ECL. Lifetime ECL is what? Over the remaining 5 years or 4 years of time, what is the probability of default? Correct, na? Which will be higher generally? Lifetime ECL will be higher. Because see, I know now 1 year may less probability may be there, but 5 years may anything can happen. Correct, na? Agree or not? So if the things are going good with him, he is good asset. I mean, no problem. Correct, na? He is paying in time. Right, maximum 0 to 30 days may everything is clearing. Correct, he is not moved to next risky bucket ko nahi. Risky bucket means I mean 90 days or 60 days. So aisa nahi kiya. No problem. I can keep it in the standard. 12 months ECL. I have to 12 months mein what is the probability I should check. Okay. Second stage, stage number 2. Stage number 2 is what? Now this is become risky. Yeah, it became risky. Correct na? So like say 30 to 60 days of DPD. Days past due. Means due date se 30 days ho gaya. 60 days aa gaya. Means now it's becoming risky or not? Initially he was not assessed as risky. Now it is becoming risky. Are you getting my point? Now what do we do? It's not 12 months ECL, my dear, lifetime ECL. For those kind of things, lifetime ECL I will follow. ECL I will follow. Getting my point? Means what? Now my probability will be higher. Why? 12 months ECL, 12 months may what is expected probability? 5 years may expected probability may be higher. Correct? Higher default can be possible. Higher amount of ECL is supposed to be done. Why? Means this fellow was at 0 DPD. Means before it become due, he used to pay. Now he is shifting to what? 32. I mean after becoming due date also he is not paying. 30 days का बाद में pay कर रहा है. April month का due is paying not in May, June में pay कर रहा है. That means something is seriously wrong. Why is paying late? Some problem तो है. Problem है means collection can be correct na. So let me make some provision. Little higher provision will happen. Third side, stage number 3. Stage number 3 is like NPA kind. Already like 60 to 90 days or something like that. 60 to 90 days ho gaya. Means once you become NPA, we'll make full 100% provision ko kar denge. Aisa, something like that. Because that again company's dependency. Company policy, it will be depending. Now, here also we'll calculate lifetime ECL. But only the problem is lifetime ECL will calculate. Yeah. Under stage number 2 mein our interest will be calculated. Interest will be calculated on the gross amount. Gross amount means what? I will tell you. Your loan amount is equal to 10,000 rupees. Okay, ECL is equal to say 200 rupees example. Okay, next year interest will be calculated on what? Under stage 2 we will apply this number. On 10,000 normal calculation will continue, but the one will fall under stage number 3. The one which will fall under the stage number 3, for them we will apply the interest rate on 9,800 mele will calculate. Interest EIR calculations will change if the asset goes to stage number 3, not to stage number 2 or 1. Okay, the concept is there at very surface level, concept is there in the ICA material. In the ICA material they just gave gross amount percentage, just you need to multiply and tell the number. If you see the exam question or ICA question, right, but practically to determine that number, so much of background work is important that you may not get it in a normal manufacturing software and other kind of pharma company you will not be able to get it. It will come only in, I told big NBFCs, banking, this concept will be practically applied deeper and deeper. Actually everywhere should be applied, but nobody applies, right? So any other point you asked and I have not covered? Fine. Hedge accounting though I told not required. Okay, it is there in syllabus, but they never ask, they will never ask, because it's optional accounting. So they should not test you actually on that matter. Fine. Will we close for the day? Yes, my dear. So chalo, let's start with Ind AS 115, revenue from contracts with customers. Yeah, conceptually this is a beautiful standard, no doubt. But yes, if I tell you if I say 20-30 opinions I have given, out of that 15 will be on this only. Okay, you understand my point? That means what problem comes with this only, right? Majority of the opinions I give is on 115, because always some judgments will be required. Correct now, reading the same line will not be changing. I will also not change the line, but everybody has to look at the sentences very carefully, and with example only you will be able to understand. Before the standard release, I mean before it is become effective, I was in Delhi for some assignment of Ind AS only. Some listed company ka Ind AS conversion for first time, so they called me. Other team members, other persons also were there. I am also one of the team member, you should say. Okay, well coming back, so there is a delay in the delay means I reached early basically to airport. I thought let me open kiya standard. Let me read it. First time I am reading. Okay, slept off. Yeah, but thank God I didn't miss the flight. Okay, that is one good thing happened. That's it. Yeah, but subsequently when we started reading, yeah, maybe first round it will be like this. Second round, third round you will start getting the grip. First time getting the grip on the standard, no doubt it is difficult. Okay, first time you should write idea what is happening, what all the information is there. Second round, third round you should go deeper in particular areas, then you will start learning it better. Fine. Anyhow, this Ind AS 115, as you are obviously aware, some basic things obviously you must be knowing. What is that? This 115, there are 5 steps, correct now? Yeah, exactly the 5 steps only we will comply. But correctly if you understand the 5 steps, then almost your job is 75% to 80% of the job is done. And whatever the different concepts they have given, like say in case of consignment, what should I do? In case of warranty, what should I do? In case of sale on return basis, what should I do? In case of licenses, what should I do?
Correct. Now, so many different situations may they have explained. Those are all actually independent. Even if you don't read also, correct. Now, first if you understand these step 5, all 5 steps correctly, if you understand, no, then individually you can go that and handle it. Okay, 5 steps are crucial, very crucial. Looks easy, not easy. When you see practical situation, then oh, this word meaning is this. You understand bulb will be on. Got my point? Right. Till that time, you will not understand. It's okay. That is for a period it will happen. It cannot happen overnight. Right. So this when I say revenue, first of all, revenue very simple. It is revenue from the contracts with the customer. So first of all, there should be a contract. Correct. The contract may be oral contract or written contract. Any kind of contract is accepted. First, the transaction should be with the customer. Correct. Now, if you remember, as per accounting standard 9, dividend is also part of accounting standard 9 income. Correct. Now, but dividend is not. Is it a contract with customer? Dividend, you are a shareholder. You don't have any contract with respect to dividend. Correct. Now, that's why dividend is not part of your 115 May. It will not be dealt. It will be dealt by 109. Hope you understand. Correct. So first is, is there a contract? Correct. Are we getting the from the customer when the other party is customer? Are you getting my point? Then only it is 115. Otherwise, it will not come. Suppose, my dear, suppose there is one land. Okay, there is a land. Then joint venture arrangement will happen. What is the land arrangement means? Land is related to X. Okay, na? Right. So there is a Y party, one Y company, real estate company will come. What will they do? I will develop this land. I'll construct some apartment or something like that. Correct na? Okay, we'll sell it. So like say example 50:50. 50:50 means suppose there are 100 apartment, 100 flats have come. Out of 100 flats, 50 you sell, 50 is mine, 50 is yours. I hope you understand. Correct na? Right. In this case, in this arrangement, this is X is a person name, Y is a company name. Got it? Right. This arrangement is, will it fall under 115 first of all? It will not fall initially. Okay, because who is the seller, who is the buyer? You are joint partners basically. Agree or not? You are coming with land, he is coming with other material other than land. Correct now? Is there any customer first? No customer. When the transaction comes in, out of 50, when I sell it to 50 customers, I will sell. No, that is what? Sale. And when this party also sell that, his part of 50, no, then only this will come under. Otherwise, it will not come. Are you getting my point? Right. Example. Next, donations. You received donation. Yeah. When you receive donations, will it be part of 115? No. Donations is not revenue with the contract. Donation is voluntarily somebody will come and give. Correct. Now, there is no contract, there is no service of goods or services, nothing is there. Hope you understand. Right. So obviously, when I say revenue, revenue is nothing but an income. Income on what? Income on sale of goods. Correct. Now, sale of goods or services. Obviously. Okay. In the ordinary course of, obviously, that is my ordinary, in the ordinary course of business. In the ordinary course of business. Yes. Ordinary course of business may whatever happens, that is the one. Now, as we discussed, this entire standard, okay, entire standard is going to happen, right? Revenue, how do you recognize? The standard, first, one second. When I say revenue, revenue from sale of goods, I told, correct? Sale of goods, correct? At the same time, sale of services. When I say sale of services, this includes obviously construction service also. Okay, na? Construction services also are going to be covered. Any kind of service. Nothing, we don't have. Earlier Ind AS 11 was there for construction, like which is equivalent to accounting standard 7. Okay, that 11 is out and if 115 has come. So now we don't have a separate standard for construction contracts. Construction contracts or construction services are also part and parcel of 115 only. Okay, for all kinds of revenue, one kind of agreement or one kind of standard. Okay, so what is the step number 1? Step number 1 is key. all steps are like step 1 to 5 are all are interlinked, right? Yeah, as you are you must be aware of it, but still I would like to give a small example to start with. Okay, suppose you purchased a car. Okay, if this is you have bought a car, this is an invoice, right? So when I say this is invoice, invoice may what is the number they have written? 10 lakh rupees they have written. Correct now. Plus GST, assume 18%, so that is equal to 1.8 lakh rupees, 11.8 lakh rupees they have written. And along with this, they gave a coupon. What is the coupon? Servicing coupons they give. They gave like 4 coupons we are giving, my dear. 4 coupons, like 2 years may you will be able to get the servicing done. What is done? Service done. Correct na? But service related have they charged? No. They said like free, it is free of, it's free, sir. Free coupons, these are all. Complimentary coupons, something they will talk. Are you getting my point? Right. Now tell me, as per the agreement, correct na? As per first, is there a contract between the customer and the seller? There is a contract. What is the contract? I will give you the car today and I will serve you for the next 2 years. Like out of 4 coupons, you have a right. So I have an obligation to serve you. Agree or not? Correct. And for the total amount is equal to actually 10 lakh rupees. 1.8 lakh rupees is GST. Correct. Now GST is, we are in, what are we? We are agent with respect to government. Correct. Now on behalf of government, we are collecting the GST. We'll pay it to government. Agree na? Yes or no? Right. But so first point number 1, step number 1. What is step number 1 here? Step number 1 is identification of contract. Correct. Now identification. What is identification? Identification of contract terms. First, do you have a contract? First thing, do you have terms and conditions? What is terms and conditions? Terms and condition, when I say, that is the duties of, correct na, duties of the seller, correct na. At the same time, duties are rights. Duties are rights of the customer. Yes, customer has to pay money na. Yes, so all that at the same time. I should not have a doubt. There is no uncertainty on receipt of money. Correct na? No uncertainty, no uncertainty, no uncertainty in collection. That is first thing. No uncertainty in collection. That should be there. And third one is what? There should be a commercial substance. What is commercial substance? You remember we spoke on day 2. Commercial substance means items are different. Correct na? Items are different. Yeah, items are same hai to there is no transaction first of all. Correct na? Milk I will give, milk I take. That is not a transaction. You understood my point? Yeah, same item if it is taking place, then it is not. I don't have uncertainty. Commercial substance is there. Duties of seller are written. Duties or rights of the customer are written. Correct na? Duties or rights in the sense what? That is nothing but payment terms. Correct na? Payment terms. When this guy has to pay. Sometimes it may be installments. Suppose construction time mein what will happen ma? Once we put first floor, you should give 10%. Second floor, another 10%. Third floor, 10%. First basement perfectly done. Then 25% you should give. Correct na? Some rules and regulations with respect to payments throughout the period. It will be there. Our terms and conditions are clear. Both of them are agreed. That is what first point you need to check. Yes, we have verified here. Step number 1, identification. In case of car, first money has to be given, then only car will be given to you. Correct? Now, if you are taking a loan also, the loan, whoever is the banker must have already processed the money. Money must have come to my account, then only these guys will give you the car. Nothing on credit will happen. Okay? Right. Point number 1. So, next, step number 2. Step number 2 is what, my dear? Step number 2 is identification. Identification of what? Identification of POs I will call. Performance obligation. What is it? Performance obligations in the contract. In the contract. My dear, it is only the contract. Na? It is not invoice. Sir, invoice copy mein kya hai? Invoice copy mein service is not there. No. Invoice copy mein service is not required. Okay, contract. Entirely the standard is focusing only on the contract, not on the invoice copy. Invoice copy is for the GST purpose. Okay, when you are giving something deliver, I have to take along with the goods GST copy, I mean invoice is required. That's all. That is a procedural document. That is not for the accounting basis. Accounting ka basis contract. Remember, this is first and foremost important. Revenue from with the customer, revenue from the contracts with the customers. Revenue from invoice nahi. Revenue from the contract se. Contract is only crucial. Invoice copy is just for deliver the goods, correct na? On the way, if somebody go GST officer or somebody should not catch me, that's all is the target. Otherwise, that is a waste paper. From the accounting angle, I'm raising invoice, so I'll book it. Nothing, nonsense. Your invoice may correct na? So then, as per my GST books, as per my accounting books, there will be differences. Difference will be there. Reconciliation karo. Then only you file GST or 9 or 9B, whatever you wanted. I hope you understand. There is an option for reconciliation in GSTR 9. 100% it will not be matching. GSTR books, correct na? GST books and your P&L sales will never match. Especially in Ind AS, to never match. Correct na? We'll give discount here. Cash discount will give. Correct na? Cash discount will reduce it from the sales here. Correct na? GST में कैसा करेगा? GST में invoice में do you do cash discount is something will come later. Agree or not? Why the sales will be reduced? It will not be reduced. So will you get differences or not? Pakka difference will come. Correct? Pakka difference will come. So it will never match. Don't correct. If somebody is telling GST is a match, means that guy did not know the concept. Seriously, it may be not. It may be not a student. Many practicing chartered accountants also will ask this question. Who told that it should match? It never matches. Not required to match. Where does it say it should match? Understood my point? Be very careful with that. So first, what is a performance obligation? Okay, what is a performance obligation? Very simple, ma. Simple words may you understand. Performance duty. Obligation means duty. What is that I should do? Correct now. Suppose example, that's right. A simple example to make you understand the concept. When you read the question, are they more important to answer at least correctly? Suppose, my dear, there are 4 laptops are there in the, okay, 4 laptops are there in the invoice, plus 4 printers also are given in the printers, are also mentioned in the invoice. Okay, na? Right. So now tell me, I have to deliver this. How many performance obligations are there? One invoice may 4 laptops plus 4 printers. Okay, I am going to give you. Now, based on the invoice or based on the contract, okay, what do you say? How many performance obligations are there? 2, 4, all together 1, 8, all together 1, okay, 1, it is 8, no, it is 8. Why 8? Each computer, does it work independently or not? Each printer, does it work independently or not? It work na. E printer, e laptop say should work. Example, if situation is like that way, then there are 4 performance obligations. Because a printer, a laptop, we have written as a 2 parts, but it is actually 1 part because highly independent, highly dependent hai. You understood my point? So how many performance obligations are there here under that circumstance where printer plus laptop together only it will work. E-printer will not work with another laptop. Correct? Another laptop cannot be attached with this printer. Understood my point? Then there are 4. Okay. Independently can it work? Yes. Assume. Correct na? Any printer can work with any computer. Then there are totally 8 performance obligations are there. Got it? Now, why that is important? When I say there are 8 performance obligations, my dear friend, today I will give you 2 performance, correct na? Today I will give you 2 laptops. I can recognize 2 laptops ka mera job done. Yes or no? My job is done or not? So 2 laptops I have given. 2 laptops ka income book karo na. Sir, 1 printer I gave it. Okay, 1 printer I gave. 1 printer ka income I can book sales. I will be able to book. Are you following me? That is, first thing is you have to identification of performance obligation, independent things. Now come to the original example. Second example, what is the first example I gave, my dear? Serving a car, one performance obligation. Do you agree with me? Right. Next to what? Servicing. Servicing the car is another performance obligation. Why? Car I can buy from you, service I can get it done by this guy. Agree or not? Correct. Na? Car I can buy from here, service I can get it done from you. Independently can it be done? Yeah, we'll purchase a bike, correct na? We should go to same showroom to get it serviced. What are you telling? There are so many servicing shops are there on the road, correct na? We can go to anything and anybody can do it. Is these two are independent services or not? Buying a car separate, selling, doing service also different. Correct na? Mandovi Motors is their example, simple. Mandovi Motors ka, they will serve only to their cars, nothing like that. Any car you can take there, any correct. I must have purchased it from some other motor cars, maybe Maruti only. I can go and get it from Mandovi. I hope you understood. Yes, 100% possible. So here now, so we have identified there are two performance obligations are there. Got it? Right. Next, third situation. One small example. Right. This is also there in the textbook or maybe in the ICA material. I don't remember exactly where it is. Suppose I purchase one software. Maybe simple example, Tally you call, Joho you call, or SAP you call, something. Just keep some software in the mind. Okay. But what do I say? E-software ka? Fine. Right. Billing में क्या होता? Billing में I will tell. Sir, first software का one job. Second, installation के लिए some money I am charging. Okay na? Right. Third is what? Updations के लिए one separate money. Right. Fourth is for repairs or services के लिए separate money. Okay na? All this money something total together 40,000 rupees I am charging you. समझ में आ रहा है? What is that? First software I will give you. I will do installation. Installation को some X money. Got it? Right. Don't keep Tally alone. Na? SAP also is there. Big softwares will be there that you may not be able to do installation on your own. Correct. Na? Tally to what is there? Simple. Executive file will be there. Click, it will come. Correct. Na? There is different. Updations. Right. Without updations also your existing software will work. Yes or no? Suppose your mobile is there. Updation you don't want to take it. Upgrade or updation only will call. No? Update will come. Updates, I don't want update. Without update also your mobile will work, will not work. It will work. Tally also will work without update. Agree? SAP also will work. Joho also will work. Done. Next is what? Repairs. Whenever you, warranty services, something like that. In 1 year time, whenever you wanted any problem is there with software, our people will connect to you and will rectify your problem. Correct. Now tell me, in this invoice, 4 lines I wrote it. Correct? Now tell me how many performance obligations are there. It all depends upon the each step. Every step is crucial. One step gone, next step is out. That's where you need to apply your knowledge. How many performance obligations are there? If you have a question, you can ask. I told any software you keep it. Tally, Johos, SAP, whichever you want, you keep it. Because we know all those. Yeah, only for this software. Installation is different, repair is different. No, installation is initial one. Repair is during the next 1 year, any repair comes, that will handle it. Okay. I will say it can be 3 or 4. Correct. If that's what I told, 3 or 4 I told. Correct na? Suppose if it is a SAP example, SAP to 3 actually, not 4. Why? I mean to say, this installation is not a general installation which you can do. There to assume it can be both the ways. I agree with you. Okay. Why? What is that problem, sir? Problem kuch nahi. If someone says this has to be done installation by me only, it cannot be done by any other professional. You understood? If the option is like this, sir, you purchase software from me, sir, you get it installed by anybody, any technical person who has got some knowledge, basic knowledge, who has got so many people, anybody can do this installation, sir. If you tell like this, that means software is independent, installation is independent, updations is independent. If you want, you can take it. If you don't want, don't take it. But this will not impact my working of the software. I hope you understand, right? Next, what is the last one? Repairs. Repairs, you can get it done by me or you can get it done by somebody else. Now, is it all 4 items are different? Correct. Or why it will be 3? No, it is a specialized installation which cannot be done by any other guys. Only from our company somebody has to come and do it. You can't get it done by outside. Correct. Under that circumstance, first 2 things will be clubbed as 1. Hope you understand. That is what crucial in any contract. When you look at, first thing you need to identify what are all the performance obligations sitting in this contract. Are they important? Okay, that's how it should your learning and practice should start. Got it? Suppose sometimes if I say, sir, I am constructing a building, I am selling you flat. Okay, flat. But in the invoice में ऐसा mention करेगा, sir, flat का cost, basic price. I mean, all for walls I will tell. Okay, bathroom fittings, some number I will put. For a tiles, I will put something. Some kitchen utilities, some number I will put. Hello, understood? Some etc. names and all I will keep it. Okay, I will keep this number. Now, how many? What are you buying? Flat. Correct ना? Invoice में ऐसा लिखा. Some builder has written like this, invoice में दे दिया तुमको. If you buy flat, all will come. Obviously, flat means without bathroom fittings. What is flat? Correct na? Without bathroom, without basic kitchen. No, it is there. Correct na? Flat. It is actually one. Just to confuse us, he will tell so many. Correct na? When I say flat, flat is flat. Maybe he may do this different services for somebody, only go and do a bathroom for them, means he may do it. But here we are purchasing as a bundle. Correct na? You may write in invoice 100 items separately. Correct na? Bricks also separate, cement also you separate, you write. Means I am not buying bricks or cement or correct na water here. I am buying a flat. Flat means it will come along with these basic facilities. Correct na? I am not asking furniture. Furniture, something different. Agree na? Furniture I can get it done my own. Correct na? So that is the basic thing. I hope you understood. So that is the crucial part, right? Now here in our case what is happened, second situation may this car is different, servicing is different. Correct na? Actually, but for correct, that is the performance obligation ka step number 2. Next, step number 3, sir. Step number 3 is what? TP, transaction price. Correct na? Transaction price. Transaction price determination. First we will determine the transaction price. Okay, what do you mean by transaction price? Listen, what is expected to be received? What is it? What is expected? Correct terminology, let me take you through there. Yeah, this is the amount of consideration it is expected to be entitled in exchange for the goods or services. That's all. From the correct now, are you getting my point? What is expected to be received or entitled? You write that point. It is an amount of consideration. It is an amount of consideration. It is an amount of consideration which is expected to be entitled. Entitled for what? For correct na? For sale of goods or services. In simple language you can write.
Yeah, the two words should be there, ma. That is consideration. Next one is expected to be entitled. E sentence should be there. Okay, expected to be entitled. When should I determine this? You determine initially only, at the time of sale only, initially. At the time of sale, I should be knowing what is that I am expected to receive. Correct na? What is expected to be received means, that is the best example, say cash discount. Okay, cash discount. Agree? Yeah, when I say cash discount, my dear friend, cash discount is given to all the customers. I may be having 1000 customers. Okay, I may be having 1000 customers. Is it offer cash discount is given to all or not? Yes. Correct na? Right. Out of 1000 customers, do you think all of them will utilize, will use the cash discount option? No, because cash discount may you have to pay in 7 days, 8 days, 10 days, something like that. Correct na? Everybody may not utilize because they don't have that working capital. May be there, may not be there. Hope you understand. Suppose I'll say that 1% or okay 5% discount. I am going to offer 5% of discount. So that means 100 rupees one product if I sell, I will collect only 95. Correct na? Don't you know this day one only? We know it. We are correct now. Out of 1000 customers, 100% of them will not utilize. I know, but some of them will be utilizing it. Hello, correct? What did I say? Some of them will be utilizing. So I at least some. Then how do I know how many will utilize, how many will not utilize? Correct na? Right. Practically it is easy. Why practically it is easy? Tell me. Tell me, ma. You just think like that. Practically you think 31st March 2025. Correct na? Cash discount will be what is the situation? Which are you must have sold it for last 1 week may correct na? You told within 10 days if you pay, I will give you 5% discount. Do you agree with me or not? Correct na? Okay. So last 1 week or 10 days ka sales. 10 days ka sales if you take it, are you signing financial statements on 31st March? Midnight only you will sign, is it? No, no. Obviously, you will be signing on 30th June or sometime at least. Assume listed company also. Correct na? Yes or no? So the next 10 days, 15 days ka next 10 days may you will be knowing how much money has collected or not. Yes or no? You obviously know it everything. Practically you know it. Correct. Now you don't need to think so too much and you don't need to calculate. Practically we know how many out of the sales happened as on 31st March. How many of them utilized the cash discount option and how much amount I have collected. Is it clearly available or not? Then why you don't know? Correct na? Why you don't know? Where is the concept you don't know? You know it obviously. Because your time is short. Because 10 days may somebody wants to utilize, they have to utilize it. Somebody bought on 31st March also. By 10th April May, his time is up. So how many people utilized? You can obviously tell it. Right. This practically it is easy. Fine. At same time, sir, how many will utilize? How many will not utilize? I don't know. I don't know means again, like as we discussed under Ind AS 37. Correct na? Under Ind AS 37, what is the words we utilized, my dear? Expected value method. What is this? Expected value method or single most likely outcome. Most likely outcome. That is expected value is nothing but weighted average. Okay, weighted average of all probabilities. Weighted average of all probabilities you are supposed to correct now. What is the probability that how many will utilize, how many will not utilize? Some estimation is the mandatorily you are supposed to do it. Practically, if it is readily available, all this nonsense is not required. I don't know if there is a circumstance, something like that, then yes, you need to do it. Got it? Next, practically, what do we will tell anybody to the client? Boss, first sales entry you book, my dear. Accountant, you don't know in days, normal entry you book it. What you book normally. Now, sir, discount entry is there, na sir? Discount entry also you book, my dear, as usual. Correct na? Discount entry क्या बोलेगा? Correct na? You will say debtor account to debit. Debtor account debit, no, sorry. Debtor account will be credited. Correct na? So you will say cash account to debit 900 rupees. Discount expenditure account to debit 100 rupees. Correct na? To debtor account. Then that you will say 1000 rupees. Do you agree or not? Let him not disturb. Let us not disturb that guy. So last day on the financial statements mein, this is a debit balance, sales is a credit balance. What we will do? We will group under one head. That is under sales only discount also will be grouped. Grouped means what will happen? 1 minus 1 plus, it will be netted off. Final number will come in the profit and loss statement. Are you getting my point? It happens like that. Clear? Yes. So cash account debit or discount account debit to debtor. Agree? Right. So discount will be separate ledger account mein maintained. Correct? Na? Sales is credited. While grouping, you know na financial statements preparation, TB2 grouping. Grouping say schedules, then go to P&L and balance sheet. Correct? Na? Grouping time, what do you do? Sales discount is not an expenditure account, discount is grouped under sales. Then automatically sales will be reduced automatically. I hope you understand. Like that we should do it, right? Subsequently, now last day what do you record once again? Suppose discount money which has come, discount related subsequently after 31st March number also, you will be aware, na? You pass one journal entry, discount expense account debit to debtor account or provision for receivable or something like that. You can make a journal entry. Tomorrow you will be getting lesser money, correct? Na? You offset it. That is very much possible, right? So what is expected to be entitled? This word is very, very crucial. Almost all kinds of discounts which you are giving it to the customer is going to be correct. Na? It may be cash discount, it may be quantity discount, volume discount, correct? Na? It may be whatever price discount, right? All these kind of things are going to be reduced from the sales. TP, transaction price, will be after reducing all these numbers. Is it clear? Right. Sometime what happens, no? Your, Amazon doubt Sangeeta mobile and all, no? Sangeeta mobile, what do? They will offer something. Not every day this offer may not will be there. Suppose today you purchased a mobile, correct? Now today you purchased a mobile. Say example you purchased for 70,000 rupees, right? After purchase within 10 days, say what is happened? No, after you bought 10 days, may that has become 65,000. Will you feel bad or that? Correct. I bought within 10 days. Say you might have not opened the box also, assume. Mobile came, reached home, you are outside. Got it? By the time you open it becomes 65,000, you lost 5,000 rupees unnecessarily. Correct? Na? Then what should I do? Right. Under that circumstance, Sangeeta mobile or some these people will say price drop. If there is a price drop, then don't worry. And the data purchase within 10 days, if it happens, drop. Correct? Na? Don't worry, you can submit the bill. I will give you the balance 5,000 rupees to you. Price drop offers will be there. Rarely, not every day. Daily it will not be there. Okay. One more thing, one more thing is normal, general. Many places may I also have seen. You purchase a mobile, okay, right? You bought mobile from Sangeeta Mobile, but why they are telling that this is the best price? Nowhere in the country you will get cheaper than this. Karke bola. Got it? Right. Once you go home and you saw now same date, another website may they are selling it at 2,000 rupees lower. What Sangeeta told? Correct, na best price. This is not the best price. See this Amazon mein itna price. I have not verified properly. It is coming 2,000 rupees lower. If you go and click that photo and give it to them immediately, then they will give you 2,000 rupees back. Okay, for everything, yes, correct. It is like that is to build the brand basically. No. If you can show me, if you can show me a price, better price than this, you understand? Then you are not going to be cheated. You are going to get the best price. I know mine is best price, but if you prove that, not a problem. You will be, will compensate you somehow. Correct. Now in this case, what will happen, my dear? While selling the mobile 30,000 rupees or 70,000 rupees, I must have booked. There is a chance that this girl will come back and ask for 2,000 rupees. Agree? Correct. Na? आ 2000 rupees ka is supposed to be 2000 rupees. I'm not entitled to receive. Agree or not? Actually, I'm supposed to receive 68,000, but I got 70,000. 2,000 rupees, whatever the amounts I have paid it to the customers. Correct na? Yeah, if not 1%, some 10% I must have paid. Our number also should be reduced, should be considered as a discount only, should be reduced from the sales. Okay, with respect to the standard, no, you should work with FMCG companies and construction companies. Second, you will get very good knowledge. Construction company, FMCG companies may, I mean, ultimate knowledge will come. Because number of offers, number of schemes, oh, many nonsense will be there. Not 1, 2, 3, 4. Got my point? Yeah, it is like that. As part of, I went to PwC for reviewing their financial. They are the auditors of Xiaomi. Correct, na? They are the auditors. 35,000 crores turnover. That quality review work has come to somebody else. They sent me for reviewing the PwC audit. You understand? Okay. I mean, we understood so many other points. Business understood. Quality wise, there is no issue. All are perfect, obviously. Their documentation styles are very high. Okay. One or two small differences, professional differences may be there. But that I cannot tell obviously here. Correct? So that is different. But when you see that, I told na, why am I telling? Xiaomi is into what? Trading business actually. They don't manufacture. They get it manufactured by Qualcomm and so many other companies are there. They will give the design and everything, they will give it. The other people will manufacture. They will sell it to Xiaomi. Okay, na? These guys will just sell it to Flipkart, Amazon and so many other people directly. They have their own stores. Agree? Yeah. So they will sell it. It's a different business. Fine. Chalo, that's a second thing. We'll see later. So what is all expected to be received, that much only expected to be entitled, that is only your TP. Hope you understand. Correct. So now in this case of my car, in my car situation, 10 lakh rupees is your transaction price. Agree? Correct na? Right. Now the next question, what is next? The third, that is step number 4. What is step number 4? Step number 4 is allocation of what? Allocation of transaction price among what? POs, performance obligations. Correct. First, what is my TP? You have determined X number you are going to get. Correct, na? You have already told performance obligations are there. Now, in the contract it is mentioned total amount is going to be, correct na? Total amount, it may be like they have already told na sir separately. Na. They must have told. If they have told fairly, it is not a problem. I'll go with them. I hope you understand. Try to catch this point. In the invoice, okay, okay, right. I told you first to software. Software. Second one is installation. Correct na? Third one is update. Yeah. Fourth one is repair. Something like that I told. Correct na? So then for suppose example here 1 lakh. Here 20,000 rupees. Here 30,000 rupees. Here 10,000 rupees. Something like that they kept it. So that has come to 1,60,000 rupees ko aa gaya. Correct? Right. So now what is their allocation is relevant? Is allocation is relevant once again? Have you understood my point? Do I need to allocate once again? It's already allocated na. Invoice में separately बोल दिया ना. Correct. If it is happened fairly ma, then each step is not required. If it is happened fairly, each step is not required. But if sometime it will happen, it won't happen fairly. Fairly in the sense what will happen? You understood my point? Yeah. So suppose updations ka actual cost will be huge money. They will keep the 5,000 rupees here. Okay. A balance amount 20,000 kar 1 lakh rupees ko jasti they will do it. Why sir? Why sir in the sense? Correct na? Cannot commission or something. Software installation will happen day to day, day Y0, day 1 only my software installation will happen. I can book this money immediately. Updates may be little later. Repairs also will, repairs related to 1 year. I have to book it over a period of 1 or 2 years. Correct. I want to show more income. Then what do? I will tell customer. I can tell customer, no, this is not related, but anyhow, I wanted to bill. This is my system allows like this. End of the day, you have to pay how much? 160,000. Pay 160,000. That's all. He also won't bother what is done separately, how you have showed in the bill is not the matter. Customer ko kya problem? Kuch problem nahi. I hope you understood. People can cheat and book the more revenue initial days. Correct, na? Deferring will be small money. They can do. Under that circumstance, allocation will come into the picture. How do I allocate? Correct. Now, what is the basis? Allocation ka basis kya hai ma? Any idea? Basis is in the ratio of. It should be allocated in the ratio of SSP. SSP, standalone selling price. Standalone selling price. Yeah, allocation should be done in the ratio in the standalone selling price. Means what? Product A or 1, if it is sold alone, how much do you charge? Correct na? As 2, standalone means without selling other products, only one item somebody comes and, because it's a PO you told. PO means performance obligation. Performance obligations means independently it can be sold, it can be used. Not necessarily it has to be clubbed and sold. Correct na? Then independently if I sell it, at what price I would have sold? You will have your list also, na? From there you can take it. Right, sir. Right, that is standalone selling price. Sometime what happens, I'll tell you. This is relevant. The questions also have been asked in that manner. A item is there. Okay, what is my selling price, sir? I sold some item for 1000 rupees ko bhi sale kiya, 800 rupees ko bhi sale kiya. I mean range. This is the maximum range mein sale kiya. This is the minimum range mein I sold it. Correct na? But in the invoice, I kept 950 rupees I kept. Correct. To this particular customer ko invoice mein 950 rupees I kept it. Then this is fair only, no? Yes or no? Correct. Because I have sold to minimum of this range, maximum of this range. 950 is falling within the range of 800 to 1000 rupees. I can say 950 whatever he kept in the invoice, that itself is a SSP. A number only you can recognize if he performs, I mean obligation is done. That means if he gives the item, you can book it. Are you catching the point or is going above the head? Okay, comfortable? Okay, so something like this may happen. We need to observe it. Suppose this guy says no 600 rupees करके लिखा उधर, किधर कितना लिखा 600. That means this is not the SSP. Correct na? So it is cheating, something is happening there. Now allocation, SSP ratio में you are supposed to allocate. Your TP is equal to 70,000 minus 2,000, that is equal to 68,000 is TP. Directly TP is equal to 68,000 here. 68,000 will be allocated between the performance obligations. That is what expectation. That's why I told the probability of weighted average concepts will be applicable. When it is not correct, it is a variable number. It depends upon people may come, people will not come. Correct, anything is possible. Right. So estimation you are supposed to apply. What is the probability that how many people will come back? Maybe you can say less probability, only 2% people can come back. Right. If they already come back, you know what is the amount. As on 31st March or as on closure of the book still not come back, their period is still there. Everybody will have a period of 10 days, 15 days, not for 6 months. Assume if there is a period, then you are supposed to go for estimation, because you cannot determine this. estimation is mandatory over there. Okay, right. So here allocation will be required. Allocation in which ratio? SSP ratio I told, correct na? Say example, 10 lakh rupees is my car I told, correct na? And what are the POs my dear? POs is equal to car and service, correct na? Invoice mein car only is there, service is not there only. But service also will have SSP, correct na? Same Mandavi Motors ko, if I take my car, will he do free of cost service? No na, he will charge me or not? Correct. He will charge, say example, 10,000 rupees per service. Means 40,000 rupees will he charge or not? Yes or no? Correct na. So 10 lakh rupees is the car if I take, say example, 40,000 rupees, 40,000 rupees is the service example. Or I'll say sir, car if I sell without servicing, I will do for 9.5 lakh rupees example. So your 10 lakh rupees of money should be bifurcated between 9.5 lakh and 40,000 rupees, correct na? 0.4 lakh rupees ratio mein bifurcate karna. Hope you understood. So 10 lakh into 9.5 divided by 9.9. Hope you understood, right? So if you do in that manner, whatever money comes, some money will come automatically here. Our number will be transferred to profit and loss statement immediately. I mean, sales will be booked to that extent. Can you just apply calculator? Now 9.6 lakh came. Correct. Now what is the journal entry you will record when you have collected 10 lakh rupees cash account debit? Correct. Now sales account debit credit, that is 9.6 lakh. This is with respect to car. Correct. Now to advance or contractual liability. Contract liability is nothing but advance only, nothing else. Okay. So that is equal to 0.4 lakhs. We'll record it. What is this 0.4 lakh? Is nothing but advance for the service. Advance for service. Correct na? When service is done, by me, sir, one service is two services are done in the current year. Current year mein two service kar diya. Then what are you supposed to do? The advance account debit 20,000 rupees to sales. That is equal to another 20,000. Next year you will do another service. Two service, that time same entry will be done. Your contract liability or contract asset or contract liability are this only basically. Advance is called contract liability. Is this clear? Right. That is what supposed to happen, my dear. Allocation is important for this purpose. Sometimes it can happen. Allocation of discount karke one more concept is there within this only. Okay. What did I say? Allocation of discount. Let me explain it to you. Allocation of discount. But you have to catch this carefully, otherwise it will bounce. In this example, correct, we have separated into two, car and service. No, not required. That is what I am telling. Whether you mention invoice, not mention is not a matter. Is it mentioned in the contract is important. Free service is mentioned in the contract, then is it obligated for him to do it? So you have to do the service. Na? If I take the car after 6 months for servicing, do you have an option to say no? You cannot say no because you already agreed. So you have to do your job. So giving car is one job, getting the service done is another job of yours, which you have accepted as per the contract, maybe not mentioned in the invoice. That's why invoice is not the piece to be considered. Okay, shall I go ahead? Right. Now listen, allocation of discount. This is something crucial, important. Listen carefully. Normally, my dear, if you say there is a product A, there is a product B, okay, na? Product C is there. Okay, right. Sir, all together, say example, I'll keep this 100, 100, 100. This is SSP. What is this? Standalone selling price. Total amount is equal to how much? 300. Correct. Now, standalone if I sell. Right. Now, if somebody purchases, situation number 1 I am explaining. Okay, situation, no, otherwise only one situation I will explain, not to give more and more. Right, observe carefully. Right. Now what is that I am doing? I am saying if somebody has purchased 3 items from me, I am giving a discount to them. What is the discount, sir? 50 rupees discount I am giving. Correct. No? So 250 rupees is what? Collection. That is what I will collect from collection from the people. Agree? Yeah? Right. Now in this case, what do I do normally? Normally what I will say, this is equal to TP. Correct. No? TP is what? 250. And this is a separate performance obligation, separate performance obligation, separate PO. Agree? Na? Now what do you do? Allocate the same 250 divided by 3. Why 3? Because SSP is 100 only. Correct na? So what do I say, my dear? Allocated TP. Allocated TP is equal to calculator 250 divided by 3. 83 yeah. Okay, 83 rupees, 83 rupees, 83 rupees, whatever, 83, whatever, 83, 84, forget about it. Correct? Agree na? Right. Now observe carefully. Now observe. Suppose, okay, what is the discount I gave? 50. Suppose somebody comes and asks me, only A plus B you give me, sir. A plus B ko how much do you collect normally? 200 should be collected. For them also I am giving 50 rupees of discount. Hello, understood? What is that I said? There is a proof. You are giving generally discount, not 50 rupees discount is not given for who purchases A plus B plus C. A plus B somebody buys also, for them also I am giving a discount of 50. Correct na? That means, but in this case, what is that happened, my dear? Can you observe? A 50 rupees discount is allocated to all the 3. Actually should have been allocated between 2. Correct? Are you getting my point or not? Should have been allocated to 2. But here it is happened between. Correct? Na? That's if you can prove that in my sales register like if you show me that A and B, if somebody purchases also you gave 15A. Adhe 50 you gave in A, B plus C also 50 only you gave. That means E discount is correct. E discount is pertaining to A and B only. If you can prove that, what are you supposed to do now? Now your allocated allocated TP will be what, my dear? Will be 75, 75, 100. Because now discount should be allocated between A and B only, not C. Hope you got this point. A and B only allocation should happen, but not to C. If you can prove it. Hope clear? Right. That is step number 4 basically. Okay. Step number 5. Step number 5 is what? Recognition of revenue. Yeah, recognition of revenue. Here, I think if I remember para 32, I think 32 or 25, I am not very sure, but forget about para don't write. Yeah, so recognition of revenue, para forget, when do you recognize? There are 3 conditions. How many conditions? 3 conditions. If you satisfy all the 3, not all, any one of the condition if you satisfy, we will recognize on the percentage of completion method. If none of the condition is satisfied, then recognize, that is called point in time. Once you complete the service, then we will book the sales. Till that time we will not book the sale. Are you clear what did I say? Right. There are 3 conditions. Okay. Right. If anyone satisfied, anyone, if any one condition is satisfied, what are you supposed to do? You record in percentage completion method, POC, percentage completion method. Otherwise, what do you call? Point in time. This is over the time we call. Over the time is nothing but percentage completion. Point in time, okay, that is after completion. After completion. Okay, right. So what are the three conditions? First point to be right. Three conditions. What are the three conditions? Condition number one. Yeah, keep something in the mind. Okay. Say a simple example, I'll say apartment. Okay, example is apartment. I mean flat sold. I constructed apartment, I sold the flats to you guys. Okay, na? Right. You are a flat owner, I am the company. Okay, na? Non builder. Fine. Now think in that fashion. First, customer should get the benefit simultaneously. You understood my point? Right. What is it? Customer receives the benefits simultaneously. Simultaneously. What do you mean by simultaneously? Immediately other party will get the benefit. Tell me, ma. I am constructing the building. This construction of apartment will take 3 years of time. You buyers, will you get the benefit immediately? Yeah. First year I constructed 20%. Have you got benefit? What benefit? Can you stay there? You can't. Can you rent it? No, you can't do anything. It's still under construction. Do you agree or not? No. This will happen. Example, what, my dear? What is that? Maintenance contracts, basically. What is that? Maintenance contracts. Yeah. Even teaching also I can tell. Correct. Some courses. I taught 50% of the subject. You got the benefit. 50% you learnt it. 50% knowledge you gained. Agree? I can say that way. I hope you got it. Yeah. Some maintenance. Maintenance means not only physical cleaning. Computer maintenance. Correct na? Repair karke bola. 50% are correct. Whenever I do repair, immediately the benefit will come to you. Yes? No? Right. So immediately the other party should be getting the benefit. So with respect to apartment sale, first condition is not satisfied. Agree? Yeah? Second, okay, seller efforts will create an asset or enhance the value of the existing asset of the customer. Okay, right. Our efforts create an asset or enhance the value of asset which is under the control of what? Which is under the control of customer. Okay, right. Tell me, when it is apartment, amma, is he doing construction in your site at my site? Apartment, you are purchasing a flat. Correct, na? So, am I coming to your place and constructing apartment, or at my place I am constructing apartment, you purchased a flat? In my land, I have constructed one. Correct, na? If I keep a brick, whose asset value has gone up? My asset value has gone up. Is it your asset value gone up? No. Correct, na? But construction is happening, example, at your site. What you asked me, Ravi, you construct 4-floored building and you leave. Okay. Now I'll bring one lorry of sand I purchased. I brought it. I kept it there. Correct na? Am I adding some value to you and your building or not? Agree na? If I keep one brick, yes, one brick worth value of the asset has gone up. Agree or not? So here in this case, example, construction, what do I say? Construction at the customer site. Construction at the customer site. Are you getting my point? Construction is happening, or suppose if I say contractor will come to your factory, we will do the installation process. Yeah, will come to your, I am the contractor, I will come to your place, if your factory will come, we will do the installation, entire installation means we will bring the machines, we will erect the machine, we will do, that is our contract. Construction only is not the contract. If I bring one machine and if I install at your place, is it adding value to your factory or not? Under that circumstance, percentage completion is okay. But in case of apartment situation, my dear, in case of apartment situation, what will happen? Does it satisfy the condition? No, it will not satisfy the condition. Apartment I am constructing means my building has gone up. Correct? My customer ka building not yet gone up. I hope you understood. Right. And the third reason. Third reason. This is, I mean, there is no alternative usage. There is no alternative use to seller. And right, correct terminology I want here again. Just a second. There is no alternative use to this is the one. It does not create, the point is very simple. It does not create an asset with an alternative use to the entity. Yes, there is no alternative use to the seller. Simple words, sufficient. Plus, the second point is what? Second point is enforceable right to payment for the performance completed, and enforceable right to receive, right to receive the payment till performance, right to payment for performance completed. Okay, payment for performance completed. Completed till date. Yeah, read it carefully. These two are clause A, clause B, but the middle one is and. And means what? You have to satisfy. If you say third condition is satisfied, means both you should be satisfied. Agree? Now you have to observe and understand. What am I constructing? Flat. Correct, na? Right. You came. You said you booked. Flat number 35 is yours. Some agreement also we have entered. Correct. Basic agreement will be entered based on which you will go for a loan and etc. Registration will be happen once it is ready. Today one normal sale deed agreement will enter. Contract will enter. Okay, na? Right. Listen carefully. Okay. Flat. Right. First, by constructing this flat, whether the alternative use in the sense what? Can I use this flat for any other purpose? No, actually I have allocated the flat to you. Correct. Have I allocated to you or not? Yes. So can I change that? No, you cannot change it. Already agreement is done. So I can satisfy first A, bit A is done. Are you getting my point? Point number 2. Yeah, what is point number 2? Enforceable right to receive the payment for the performance completed till date. Tell me, ma, I have constructed 60% of the work is done. Got it? Can we cancel the contract? Can you come back and say, no, I want to cancel? Yes or no? Based on terms and conditions means as per the RERA Act, my dear. Okay, any customer can cancel the contract anytime. You can do some 5% to 10% of the total payment. You can cut it and balance you are supposed to give it. You cannot stop the customer. Correct? Nothing doing. I will construct and give it to you. Are you getting my point? I will construct and give it to you. You can you die or you sell it करके ऐसा कर नहीं बोल सकता. Is it clear? Okay. So what does it mean? You constructed 60%. Suppose I sold it to this girl paid 40%, subsequently she did not pay. Now she is coming and telling, sorry sir, I don't want, I gave 40% ना, आपका penalty 5% cut करके दे दो, balance 35 give it to me करके she is asking. Do I have enforceable right? Nothing doing, I already constructed 60%, first pay balance 20%, then you leave. Can I ask like this? You cannot. That means third condition also not satisfied in case of flat sale. Agree? Correct. Na? That means what this flat sale people have to do? Book it only once the, right, not payment completed, registration is completed, I should say in simple. Once registration is done, OC occupancy certificate from the local BBMP, correct na? Municipality say you must have got the occupancy certificate for the building. Construction is done means what? Occupancy certificate has to be obtained. For small builders scale occupancy they will not ask, but for the big builders so occupancy is must. Got it? You have to obtain. Till that time booking is not permitted, because you cannot go by percentage completion method. You have to go by point in time. Correct? Now how do you go? You go by point in time, right? One second for this. Yeah. So enforceable right to receive the payment. First one is no alternative use. Correct? Na? Right. This is very crucial, my dear. This is what practically, na, most all other conditions, very simple. Anybody will apply their knowledge and anybody will tell. Correct? Na? Simultaneously, am I getting benefit or not? For that, they don't need to come for any opinion on that. Agree? Right. Second part also, is it creating an asset or enhancing the asset value of which is under the control of the customer? That also nobody need to come and ask. Always the problem will comes. Correct? Na? Problem will come. Do you have an alternative use of the asset? Or do you have a right to receive? Correct? Na? Right. As I told you, in case of flat business, just because you constructed 60%, some customers stopped paying after 40%. Correct? Na? You cannot go and ask, no, you have to pay 60% and go. No, he can say, no, I'm sorry, I'm facing my problems I have, so I'm cancelling the contract. You pay me the balance. You cut your money and you pay me. And again, as per the law also, as I told you, RERA will not permit you to say that. Okay, you cannot take whatever I have paid, everything is yours. Sorry, not. You have to find another customer. If X is cancelling, you have to find Y. That's all. You cannot do anything. Hope you understood. Right. So that is, these are the things you have to test. These are the things which will be required in your interviews also. They sentences are required. Obviously, na, how do you go by percentage completion or not? That is the only method. Hope you understood. Right. Point in time. Correct. Now, when do you say point in time, my dear? Point in time. Point in time, I said when you do not satisfy any one of the conditions, will go with point in time. Point in time when control over the goods or services are transferred. When control over the goods or services are transferred to the customer, are you getting my point? That time you are supposed to record. So the word used is control. Okay, control is something I should say. Okay, there will be slightest difference will be there. Okay, to understand, ignore it. Risks and rewards are also nearby the same word, but still you use the word control. When control is transferred to other party, so sold goods to you, control is shifted to you, then yes, please book the sales. Till that time, sorry, you cannot book the sale. Correct na? Or what is that? You will say completion service contract. What is that? Completion. Correct na? Completed service contract. Completed service contract. Right. Once you complete the 100% of the job, that time you can book the sales. Till that time, sorry, you cannot book the sales. Is that clear to you? Right. That is what important. Fine. Next. When I say percentage completion, that is a POC method, percentage of completion method. Okay, na? Yeah. When I say POC method, percentage completion method, my dear, there are two methods are available. How do you determine? How to determine percentage? First question should come na. How to determine percentage? What percentage completed? Any idea? What methods are there? by any chance? Right? No problem. You right, there are two methods, my dear. There are two methods. You must have heard this. Okay, one is output method, next is input method. Output method, next is input method. Are you following? Right. What is output method? Output method is how much output came. Output came means what? How much I served the other party. You understood my point? What did I say? How much I served means you got the benefit. Example, I said 30 hours of class. As on 31st March, 15 hours of class is delivered. Means 15 hours of class, you got the benefit out of it or not? Yes. Okay, irrespective of my cost incurred for this 15 hours is not the one. How much output is done? Okay, right. I hope you understood what I said. Output method means it is based on the correct now, based on the benefit derived by the benefit derived by the customer. Okay, based on the benefit derived by the customer. That is first thing. Right. Input method is nothing but cost method. Input method is nothing but cost method. What is cost method? Cost method is simple. Percentage completion means correct na cost percentage. This is cumulative percentage. Whatever we calculate any time, my dear, this is a cumulative percentage till date. Percentage completed till date, not only for the current year or last year. ऐसा नहीं है. Percentage completed till date. So cost incurred till date. Cost incurred till date कितना divided by total cost. Total cost for 100%. 100% completion means you must have incurred plus to be incurred, right, into 100. Then it will give you exactly percentage completion. Have you understood? What is incurred till date plus incurred plus future incurred? That is what full 100%. Cost to complete, cost incurred plus cost to complete. 100% completion के लिए पूरा कितना cost हो जाएगा? Budgeted plus actual, everything will be there. Correct ना? 70% completed means 70% is actual cost, 30% is budget. So that's why 100% का number denominator में आ जाएगा into 100. That will give you percentage completion. I hope you understood. Here you need to, some questions were asked some time before. Okay, right. You need to be very careful with respect to this. Listen here, my dear. Right. Output methods. I'll take the text and I'll explain you from there. That's more than sufficient. Output method. Here you see value of the goods or services received by the customer are benefited. That is how much is derived by him, reached him. That is more important. Out of the total. Okay. Here, there's the way of the style of the formula what they keep. No, they have not used the into 100 here. Correct, no? They have not used the 100. But what is the formula I gave you is into 100. Adu correct, idu correct. Okay, right. What do they say? Their answer is always like this. 70 is done divided by 30. Like that they will write. I hope you understand. This is ratio. What is this? Ratio. But if you, this is whatever they give information is ratio, not for the percentage. But if you want percentage, if you want what are you supposed to do? 70 divided by 70 plus 30 into 100 you are supposed to apply. Got it? That is how you should. What is the formula I gave you is this one. Don't need to go by their formula. Answer is same. Obviously, answer is going to be same. So, what is output method? Output method is like a surveyor method. Surveyor will come and say, yeah, you have completed 60% of the job. Then we will book for 60%. Hope you understood. Right. Time lapsed. Yeah, I told 30 hours ka class. 15 hours you have completed. Done. Maintenance contracts will be there. What is the maintenance contracts? 1 year maintenance contract I took. Correct. Now 6 months over. So 50% I can recognize. It's because of the time. Na? Based on the time I can book it. Right. Milestones reached. What is this? Milestone reached. Sometimes what happens when you are obviously all these long-term contracts, software business may it will happen. What will happen? Software mein, construction mein, many place mein it will happen. Software, you suppose say you are supposed to develop a software which is taking some 2-3 years of time. How much time? 2-3 years of time it is taking. Right. They will keep the milestone. Okay, milestone means like, okay, stage 1 reached, stage 1, stage 2, that is stage is called milestone here. Simple, that's all. Okay, stage 1 completed means 30% completed. Stage 2 completed, 50% completed. Stage 3 completed, 70% completed. Milestone achieved. Then according to each stage, percentage must have already been allocated in the beginning itself. So 70% accordingly will book it. Hope you followed. Like this, it will be determined if it is output method. But listen again, whenever I say output method or input method, my dear, sir, can I select whichever the method I want? But first of all, my dear, there is no choice. Okay, right? What are you supposed to do? What is suitable to your company? What is suitable? Correct. Now, what is suitable to the situation? What is suitable to the situation? That only you are supposed to select it. Okay, selection is actually selection is not there. If you feel this is cost method is more suitable, which will actually see, objective is what, my dear? What is objective? Percentage completion means what? I have been given with a task. Isme how much completion I did. Correct na? That percentage revenue should be recognized. That is what the objective. No? Let's go with the objective oriented. So, if what is better, which will give real picture. If I see from the customer angle what is received by him is giving the real picture, then please follow that one. Okay, right? No. What he received is irrelevant actually. I have already completed my job. That guy is not able to receive because of his problem. Suppose sometime what happens, my side value only will be more relevant and reliable, means you can follow cost method. Most of the construction will follow the second one, input method, not the other side. I hope you understand. Right, I'll tell you. There is one construction company in Kormangla for which Ind AS implementation I have done. It's a big one, that is Saudi Wala. I mean, they have invested here, private limited company. So I will not tell names. Okay, right. So what do? They will not construct on their own. These are all subcontractors to example. Shriram Properties is one property. Correct na? Prestige is another property. Correct na? So many different builders are there. Actually, they don't build. They just do the starting. They do advertisement. That's all. They will give it to subcontractor. They'll all give it to this company, say X Limited. Do you think this X Limited will get it constructed? They will also construct. They will give it to someone down. That guy does it. But these people will take responsibility. Like how the Prestige is taken responsibility. Prestige ko these people will take the responsibility. But one more layer, down layer, real construction person will come. Who will be there for me, sir? Who will be there? Who will be there for me? I'll have some my engineers to set whether plan is correct or not. Correct, and supervisors. Yes, obviously, when you are constructing, your team will be there to construct down level. Correct, na? But when you are constructing, our person will one wall has to be constructed. Correct, na? Your team should approve. Your team should approve. My team. This is the middle, not the prestige. Prestige wala will not care only. Last May he'll come. Or like monthly, once or twice. I mean, you understood now. He'll come. He will not be there at the site all the time. I mean to say. One wall has to be constructed. First, this guy will approve. As per planning, hai karke. They will tell us, yes, I have to construct a wall here. Correct na? Ha. This guy also will approve. Then wall construction will happen. Understood? Now, how will, right, who is my customer? Prestige is my customer. I am billing it to Prestige. Correct? They will bill it to customers. That is their problem. Now, Prestige side, one person will come and do the survey. How much work is completed? Sometimes only to that extent they can bill it. Beyond that, they will not bill. Sometimes what happens, as on 31st March, okay, survey has done on 15th March. And 15th March to 31st March also I must have done some job. But in the survey report, Our 15 days information is not there. Agree or not? Right. Other thing, isn't it that surveyor correct? Sir, sometime what happens? Entire wall is constructed. Okay. Yeah. Only this window is what something pending. E window ka item also is sitting there only. What is supposed to be done? Our person should come and put okay, here 4 screws, here 2 screws, correct? 10 screws fix kar diya, to kaam khatam. You understood my point? So 2 windows, if I keep it, this wall also should be taken into account. My percentage will go up. But survey will say no, it's not done. Still window is not there. All done. Expenditure is done. Window also readily available. Putting the screw is only the how much time does it take? You understood my point? That cost also we will take it. Surveyor method fully we don't follow. Then also we said like first they were following surveyor method. Then we said no, that is not suggested. Why should we? As per IGAP, they were following only surveyor method. Their auditor suggested. Then when I went and said no, it is why are you not booking the revenue? Job is done. Correct na? It's a matter of 2 minutes ka putting the screw or half a day job is pending. Book no revenue. Why are you correct? What is wrong in this? We made them book 75 crores. No, but that is correct only. And then I mean whoever the auditor, I had a meeting with them. Correct na? Right. I explained. It is allowed as per the standard. I can show you from the standard. What is problem? They agreed. Fine. Everything went well. These guys also happy na? Now they can show more revenue. Correct. Earlier they were booking less revenue. 75 crores is not a small number. They were booking approximately 500 CR. Now 500 mein 75 is 15% ज़्यादा na. Not a small number obviously. Correct. Not 30,000 crores mein 75 is nothing. 500 mein 75 is considerable number. Got it? It will happen like that. So, but here I mean to say for output method input method is not a choice. Correct na? That's why I have given it here very clearly. Correct na? The entity does not have a free choice. Whichever method I want to follow. No. Which is suitable. The objective is what, my dear? Objective is what? Here you see, observe this line, my dear, carefully. You see this. First read it carefully. 2 lines highlighted continuously. 2 line. What is that, my dear? The objective of these methods is to depict. Depict means picturization. Right. What is picturization? Entity performance in transferring the control of goods or services to the customers. Means what? Depict means what I said? Picturization. Which method with picturize? Correct picturization. Correct. Now 60% is really my job is done. Which method will picturize 60%? Suppose output method prakara only 50% coming. Input method is giving better correct number, not like higher percentage. No. Actuality should be picturized. You understood my point? You draw my picture, some other face came, not Ravi Kanth came. You understand? Then that is not the right person, right picture. Correct now. What is there? Ade should come. Which will be more better. More clarity will be there in correct now. In output method or input method, that method only supposed to be selected. That is not a free choice to anybody. That is not a free choice to anybody. I hope you understood. Right. Next. Anand, you have a question? Owner builder is how it will be? Then that is where is the customer here? No way. See, first thing is first there should be one customer. If you say I am constructing for myself, then I myself cannot be customer and I cannot be seller. Correct na? In my example, it is different. Builder is Prestige. My company X Limited is building on behalf of Prestige. We will bill it to Prestige. Prestige will collect the money from thousands of customers. If it is both party, I am only constructing, I am only doing, then who is my customer is only these guys are my customers. Correct now. For them, that sale cannot happen percentage. As we said, till you complete entirely, we can't do it. We can't do it. And again, the worst problem I tell this real estate industry, sorry to say, everybody follows in their own fashion. Worst means worst. They don't follow. Actually, they cannot follow percentage completion method. Some listed companies ka dekha. I will not talk here. It is recorded. Okay, that is the reason. You know, they are not following the method correctly. Big firms are signing. Okay, top 5-6 companies for audit firms are only signing. And the worst problem, you know, how much profit you want accordingly above number will determine. No. See that if it is happens for the small persons or companies, that is okay. I understand. Why it is okay? It is related to his problem. If Ravikant is saying you determine only like this much profit, only show it. Problem is fixed to Ravikant, no? Correct, na? Kuch ho gaya, it will happen for me and department. That's all. Listed company ko if it happens means is it only for a company? Yeah, the shareholders, no ma. Here you have to be more careful, no? Private company में गोलमाल हो गया. Maximum bakras are the investors. Okay, limited number of vendors, lenders also may be there. Lenders, they will be secured all most of the times. Okay, they are secured most of the time, so not a problem. But listed company में bakras are shareholders. It happens like that. Sorry, ignore. Okay, now what is the input method? Input method mein I told resource consumed. This is what cost basis. How much cost you have incurred? Cost incurred till date divided by total cost into 100. Again, here also it will be into is not there, observe. Correct, na? So, cost incurred to be incurred is down. Understood? That is ratio. What they give is ratio. That's why into 100 won't be there. What I gave is a percentage. That's why into 100 has to be kept. Just follow my formula. That is perfect. Both are same answer. Obviously same answer. Labor hours spent. Cost. Okay, these are all what? How much time and efforts I have put in is what is going to be considered, not how much benefit has derived to the other party. Because some of the examples you can very easily you can make out. I have incurred, I have spent my money, correct? I have spent everything. I told na, just because one window is not fixed half an hour job, you can say I have not done the job means that is wrong. No, correct? 95 98% job is done, half day job is pending. Got it? Right? Entirely wall is ready, only painting is little pending. Painting cost how much? Wall construction cost is how much? Correct na? Painting cost is not even 1% of or 2% of the construction cost. Then why do you need to bother about it? That's why percentage will be many construction times may cost input method will be making more sense, except if there is a separate circumstance that I can agree with somebody. Okay, right. Next point, which are all the things I am supposed to take it? Okay, right. First thing which you should not take, you listen. Cost construction, cost mein they have given one time, my dear. One time one question has come. Beautiful question, we will solve right now, immediately. I'll take another half an hour approximately for this standard only, so that you will get better idea. Okay, half an hour or 45 minutes, let's close this perfectly. See, one question may what they have done. A question they have asked. Okay, it has happened. A question it has come in the exam. I think so. RTPR exam. I'm not very sure. Just 4 months before or 2 months before, another company, Amran Batteries, you know. There also one same circumstance has happened. Their accountant has called. Okay, CFO level, obviously accountant means here, not a down level fellow. Correct, na? They have called for some opinion. What should I do? And one more company, same kind of nature. I mean, Hyderabad company, Tata's subsidiary company. Okay, that company get the contract, subcontract from ISRO. Okay, to manufacture, because ISRO will not manufacture everything. You got my point. ISRO will bifurcate the Parts and pieces mein they will bifurcate it and they will give it to different companies. Okay, all parts and pieces will be manufactured by different technology companies. Understood? What do they do? As per design and all will be given by ISRO. They will take this. They have to apply what? On designing part, not on the manufacturing part. Why should they bother about all these things? Correct, na? So all these parts and pieces will be accumulated. They will have their own knowledge. Correct, na? That they will assemble it and they will send it. Understood? It happens always like that. Huge expenditure, I mean huge money. Example to make you simple understanding. Okay, I am constructing one building, one mall, assume. Okay, what is this? Escalator, you know, na? Escalator. Escalator is not a small one. Escalator, I got it. Got it means not yet installed. All escalator related money, I mean, I have paid. Escalator physically came and sitting in the site. But is it done? No, not yet done. Are you getting my point? Escalator cost is equal to, say, example 10 CR. Just simple number I am telling. May not be not one escalator, no. Maybe 10 escalators are there here. Assume, example ke liye. I just brought it and kept it. Correct. Installation is not done. Now the question is what, my dear? Am I computing the percentage completion or not? Yes or no? Yes. If I take this escalator and that cost incurred karke 10%, 10 crore rupees above and 10 crore rupees below le liya to, e percentage will change or not? Pakka will change. But have you done any work for escalator? Outside se purchase kiya and you kept it at the site. It leads to more expenditure, more percentage will come. Is it correct? It is not correct. You understood? If it got it installed, take it. Correct na? Percentage. Escalator, you just bought it, you didn't do any service. Same kind of job was happened with respect to those two companies also. After 6 months, after I expressed my opinion, subsequently some same metal maybe as a question bhi aaya. It was a same inline only, no issues. Some it's a coincident. Understood? So you should not take everything, you cannot take where you have not done the job. Just got the money, just got the asset. Have you done any work on that? Not even 1% you have done the job. Then if you just consider that that for the percentage calculation, it won't make any sense. It won't make any sense. You shouldn't do that kind of thing. Now here, cost ke liye what all the cost should be taken? Okay, when a cost which should not take, when the cost incurred does not contribute to the progress of performance obligation, it doesn't add it to anything. Correct? Example, administration cost. Okay, abnormal loss, selling and distribution cost, any administration cost, you are not supposed to take it into cost. Correct? Now your company is there. Prestige some companies are. They'll have a lot of selling part. I mean, sales agents will be there or not. Correct? A lot of business promotions expenditure, a lot of brokerage is supposed to be given. So much expenditure will be there. That cannot be considered as cost of construction because that is nothing to do with performance. Understood? Right. So input costs are not proportionate to the construction process. Okay. If it is more, I mean, if incurred costs are not proportionate to the progress to the satisfaction of that, means if it is those in measuring, I mean, it is not directly related in the simple word. Instead of, if you cut this sentence, it is not directly related to the construction process, then you should not take it into account. Okay. What should I take it? The incremental cost to obtain the contract is you have to consider. What is that? To get a contract, you must have prepared one project report. Correct. Now you must have done the estimation. Correct. Now quotation you have to do or not. Sometimes, yes. Your quotation process is not like one day, 1 minute mein quotation cannot happen. Correct. Now properly estimation, some time, hours has to be incurred. Then quotation will come out. Our cost also is going to be part and parcel of cost only. Okay. Right. Listen here. Concept capsule 35. Just look at this. J Limited entered into a contract with the customer to transfer a software license, performance installation and provide a software update and technical support for the 3 years. in exchange for 2,40,000 rupees. Okay. So how many performance obligation? Okay. What is that? 1, 2. I told no. This example, same example only I gave. Correct? Na? 4 performance obligations are there. Total amount what is that you have collected? 2,40,000. This is nothing but my TP. Correct? Legal fees for correct. Now the question is what? These are all the cost incurred by them. Out of these cost, how much will be taken as a cost of construction or cost incurred to directly related to the project? You have to tell now. Correct. Read it. Legal fees for drawing up the contract. Shall I take this as or not? Traveling cost to deliver the proposal. Means you went to US, Delhi to submit the project. You understood my point? Project report you are giving or quote you are doing. Shall I add that cost also? Commission to the sales employees. This to without doubt pakka no. Correct na? Right. Now what should I say? The other points. Which one I should consider? Which one I should not consider? Legal fees will consider. Next. It is a proposal purpose. Hmm. Yeah, if project is not approved, all that cost will be charged to P&L. There is nothing to, there is no revenue, related revenue. Obviously, cost will be charged to P&L. Assumption is what? Contract you got it. It is not intangibly charged off. In case if it is, you are not entitled for a, if you have not got the contract, then it will be charged to P&L. If it is directly attributable to a contract, any this above one, that is what incremental cost to obtain the contract. Yeah, so that is what the answer here. Traveling cost to deliver what you told is correct. I was just trying to question. Let's see what is that your answer will come. Fine. Travel cost to deliver the proposal. This will be happened irrespective whether you are going to get the project, do not get the project. Still, it is supposed to be incurred. Agree or not? Right. That's why this is supposed to be charged to profit and loss statement immediately. I hope you understood. Right. Not what I mean to say. Here you observe carefully. Incremental cost to obtain the contract. These costs that an entity incurs to obtain the contract with the customer, it would have not been incurred if the contract had not been obtained. A sales commission. Okay, sales commission. Okay, sorry. Yeah, here commission to sales employees, fine, different. Here commission, whatever I am talking here, it is like a brokerage, what I am trying to explain you. What is that? Brokerage. I gave a brokerage or commission to somebody, that's why I got the contract. Then you should consider, you have to consider. I hope you understood. To get the contract, not to get the contract in the sense, if you get the contract, if I have not got the contract, I would have not paid this commission. Third party only involved, obviously. Right? First you read the answer. That's all, no answer. Okay, yeah. Just go through once. Travel cost should be expensed because they would have been incurred even if the developer did not get the contract. As I told, the legal fees and sales commission should be recognized as an asset. Asset in the sense it is going to be contract cost. What did I say? It is a contract cost. Okay, listen. So my understanding of sales commission here is different. Here I thought that this is two different kind of sales commission. I mean, normally selling and distribution expenditure is what I thought. But here their meaning is here brokerage. What is this here? Brokerage. If it is a brokerage to get the contract you have paid, you are supposed to add this to the contract cost. Correct. Next, because they are incremental cost of obtaining the contract. That is, the entity would have not incurred these if it did not get the contract. We assume that these contracts are recoverable, so it should be amortized over the contract term of these things. First doubt should come, why it is this assets are set in the sense, my dear, don't charge it off immediately. Okay, yeah. See, simple example, ma. Today you have incurred, say some whatever, some 1 lakh rupees you have incurred. Revenue will be booked in the next year. This is cost. What should I do with this 1 lakh rupees? Shall I charge it? No, should not charge. Why should not charge? Revenue is coming when? Next year. That's why what do? This you transfer it to WIP. Or where should I transfer? Right. It is an inventory to you, asset to you. Correct? Na? What is that you should say? It is an inventory to me because you are under the sales count. Sales. Correct? Na? This is a cost what you are telling. So inventory WIP is nothing but your asset. When you book the revenue, correct na, proportionately that expenditure also you are supposed to book it to the P&L. Are you getting my point? If I say 60% I am booking the revenue in the next year, then my total cost may 60% also I will be booking it in the expenditure also I will book. Till I do not recognize the revenue, it is supposed to be right, otherwise around. 1 second. Simple example. In case of construction business, okay, right, construction business or flat business, I will tell simple language. Right, and I told you already, it is most of the circumstances, it is point of time. Do you agree with me? Correct. So, right, flat construction will happen how many days? 3 years, not days. Correct, na? Number of days or it will take a lot of time. It will not happen just like that. Do you agree with me? Agree. So now, my dear, first year you have incurred. Building construction will be keep on going. Correct, na? When it is happening, you incurred say 100 CR, you have incurred. What is the entry you pass? Labor ko pay kiya, raw material you purchased. Correct, na? So many things are there. Now what are you supposed to do? WIP asset account debit. Correct, na? To payable or cash, whatever if it is already paid or payable is supposed to be done. Hello, understood? So it will sit as an inventory WIP mein baithega. And customer has given you some money. You must have collected money. Na? What is this? Advance. Correct, na? That is called contract liability. What is it? Contract liability. That is nothing but advance. Our money also will be sitting in the balance sheet. Hello, correct? So in the profit and loss, when we go after the 3 years, once either registration is completed, that day what will happen? Whatever you have collected so far, money will become my sales. Correct? Now whatever you have, correct? Now are you getting my point? Say out of this also in the current year, 30% registration is completed, 40% registration yet to complete. Then 30% of whatever related to that those flats money, because every flat is not same. One may be 3 BHK, 2 BHK, 2.5 BHK, something will be there. Our money will be advance. You must have already collected money. Our money will come to sales, and proportionately this money also will become the purchases. That day my profit will be booked. Understood? So whatever the expenditure you have incurred, till you book it will be go to first. It will go to where asset, inventory, asset ko chale jayega. From there, it will be shifted to the expenditure once you book the revenue booking time that is supposed to take place. Is it clear? Right, that is the first and foremost. Right, cost to fulfill the contract. So they have given like so much of list. Yes, all the direct labor cost. Okay, majorly these are the three. E3 ka explanation is this: cost related directly to the contract that can entity specifically identify, means specific identification of cost. E building को वाटर कितना स्पेंड किया, पावर कितना स्पेंड किया, रॉ मटेरियल कितना, सीमेंट कितना, लेबर कितना. करेक्ट ना? हाउ मच इज माई rentals? Sometime bulldozer will come, I am renting it out. Correct, I am taking it on rent basis. Correct. Now, some consultants are there, engineers and etc. I will be paying them on consult, not an employee. Correct. Now, employees, if their labor features, employee cost, everything specifically identification cost should be taken. All other costs to generate or enhance the resources, whatever. I mean, all directly related. The cost expected to be recovered. I spend some money, which I can able to bill it to my customer. Sir, I spend some money, I will not be able to bill it. Are you getting my point? Then now customer will come and ask, sir, the tiles I don't like, sir. Put different tiles. You will tell, yes, I will put, no problem, sir. But is this tile ka cost 10 rupees? You are asking for a different tile for 15 rupees. 5 rupees you have to pay. Correct na? So now, is it recoverable or not? Recoverable or not? Then 5 rupees will become cost, 5 rupees collection also will become sales. If I spend something, got it? And I am not able to recover from you as per the agreement, it is my loss. Are you getting my point? It's a loss to me, like an abnormal loss. It should be charged off immediately. It cannot be sitting under asset. That is what the point. This was asked in May 2019, little modified to the requirement. Yeah, read this very beautiful question. Then we'll go to specific questions. Just go through, my dear. Take a minute. Yeah, my dear. So in November 2021, the same example which I was trying to give you, correct? No? Can you, on reading, you were able to, must have made it. This was asked in exam, but yes, long ago it was asked. That can come in exam also. Okay, don't underestimate. 2019 mein pucha. No, there is more probability those questions only can be repeated. Okay, right. Especially not recent ones. Old ones only he'll bring back. First in, first out, or something like that. Right. So in November 2021, the entity contracts with the customer to refurbish 3-storied building. Refurbishment means you are not constructing, you are redesigning something you are doing. Correct, no? You understood? You will not start from the scratch. Right. And install a new elevator for the total consideration of 5 million. Yeah. Refurbishment karna plus elevator, escalator, whatever, something like that, you have to put it. Done. For a total 50 lakh rupees is the concept. TP. The promised refurbishment service includes the installation of elevator. Okay, is a single performance obligation satisfied over time. Over time means what? Percentage completion. Correct na? They only told it is satisfied over time. Over time, point in time. Point in time means towards the end. Over time is over the time. That's all. That is percentage completion. So they only told, you don't need to break your head. Total expected costs are 4 million. That's why you want to make 10 lakh rupees profit. Done. Including 1.5 million for the elevator. So, if 4.5 may, correct na, 2.5 related to other refurbishment, 1.5 related to this one. The entity determines that it acts as a principal. Okay, we are not the agents, we are only the principal. Not a problem. Okay, that we discuss. We'll discuss the principal agent concept also immediately after this. A summary of the transaction price and expected costs are as below. Transaction TP, this we already understood. Elevator ka, this is clear. Other cost we already spoken, 40 lakh, I mean that is the same above the line only be given below. The entity uses input method, that means cost method they will follow. Based on the cost incurred to measure its progress towards the complete satisfaction of the performance obligation. Done. The entity assess whether the cost incurred to procure the elevators are proportionate to the entity's progress in satisfying the performance obligation. Okay. The customer obtains the control of the elevator when they are delivered to the site. Correct. Once I keep it at their site, control is transferred to the customer. But my job is there to install also, no? Not just keeping the elevator at the site and run away. No, no. Your job is what? Bring the elevator, get it installed. Both are your jobs. Okay. In December 2021, they already delivered. Although the elevators will not be installed till June 2022. Okay. If you are doing the metro may when will they come and fix the escalator, my dear? Not at the beginning, towards the end only they will come and fix. Otherwise it will be, I mean, dust and everything will sit there. It will stop working. Correct. Otherwise labor also will use elevator only for material and etc. Correct. No? Means there will be some problem. Labor means singly alone. If one human goes, not a problem. He will go with material and etc. Na? Then it will be spoiled. Correct. Na? You have so many other ways to lift the material. Correct. You will not be doing it in physically. So many machines, so many things are there to take the material to the top floor. Right. The cost to procure the elevator 1.5 million are significant related to the total expected cost, completely satisfy the performance obligation of 4 million. The entity is not entitled, not involved in designing and manufacturing the elevator. I told them they just buy and kept it. The entity has incurred, okay, other costs of 5 lakh rupees by December. Other cost means out of this. Hello, understood? Then how should I recognize percentage completion? I'll tell the wrong method. What is the wrong method? First, I'll tell. Total cost is equal to how much? 4 million. Correct, na? Right. Total cost is equal to 4 million. Out of that, what is incurred if somebody asks, na? 1.5 I have incurred plus 0.5 I have incurred. Correct, na? That is equal to 2 divided by 4. That is equal to 50% I have done. Are you getting my point? So then in the profit and loss statement, 50% means how much, my dear? 2.5 million I will book here. 2 million I will book as a expenditure. So I can take a profit of 0.5 million. Is it correct? Actually not correct. Okay. Why? Why not correct? Means I will tell. Because with respect to elevator, have you done any job? Not done. So what should I do? You have to calculate separately. So now how should I calculate? Right? E-job, you just brought the asset. Nothing you did in this. But with respect to 25 lakh rupees, 5 lakh is job is done. Because you gave it down. Correct? Na? Other costs are, the entity has incurred other costs by 31st December. Correct? So what should I say? 5 divided by 25, I mean 2.5. That is equal to how much? 20% job is done. Hello, correct? Yes or no? Yeah. So now tell me, my dear, 20% job is done means 20% of 5 lakh is how much, my dear? 20% of 5 million is equal to how much? 1 million. Are you getting my point? Right? Yeah. 1 second. Here, other cost incurred for the elevator is how much, my dear? 5 lakh. That is nothing but you have performed a survey. I mean, what is the percentage you have completed? 5 by divided by 25, which is equal to 20% you have completed. So what should be your revenue, my dear? What should be your revenue? 22 lakh. How did you get 22 lakh rupees? Yeah, look at here. Total is, what is the total? 35 lakh rupees, correct na? Out of 5 million means 50 lakh rupees. 50 lakh rupees. 15 lakh related, I will leave it aside. Why I leave it aside? Your job, you are not manufacturing anything. Correct na? You just purchase the item and you keep it there. That's all is your job. That's why if I remove that number, that is equal to how much? 35 lakh. 35 lakh into 20% is equal to how much? 7 lakh rupees is your actual revenue. Do you agree with me? Correct. So in the profit and loss statement, what do I say? Under sales, I will say 7 lakh. Okay. Under cost, how much I have incurred cost? 5 lakh rupees. But sir, I have spent 15 lakh rupees now. That's why what do I do? Yahan pe bhi 15 I will add. Yahan pe bhi 15 I will add. I'm not taking profit on 15 lakh rupees. Are you getting my point? Purchase sales, both the numbers I will take it. Okay. So add it to purchase, add it to the sales. So that's what 15 plus 7, that is equal to 22 lakh rupees. 15 plus 5 is equal to 20 lakh rupees. That's how 2 lakh rupees is a profit to you. Is that clear? Because you have not done, what is your job of installation? You have not yet done. You just brought it and kept it at the site. Is this clear? Right? Chalo. Now, some more. Now, this is the overall concepts of Ind AS 115. Right. Now, specific to the concept, okay, specific to the concept when you see, right, agent or principal. Agent or principal. How does it differ, my dear? Your agent. In case if you are agent, what will happen? If you are agent, what will happen, my dear? Agent means you will recognize only to the extent of your commission. Okay, if you are agent, you have to record only commission. If you are a principal, yes, total revenue, correct na? Total revenue you are going to recognize. Next, commission, whatever you commission paid, whatever you are going to pay commission, that will become expense. Okay, right. In case of principal, in simple word I can tell, this is net presentation. Sorry, gross presentation. This is gross presentation. Yeah, in case of agent, it is going to be net presentation. Okay, simple. If I say, I am booking, correct now, I am booking Indigo ticket. Indigo ticket. Okay, now who are you? Are you Indigo company? No, no. I am booking for Indigo. I am an agent. Correct na? So you collected from the customer, assume. You collected from customer. Our customer say will assume, okay, so 5,000 rupees is the ticket value plus 250 rupees I collected a commission. Are getting my point? So 5,250 rupees is collected from the customer. Right. Now in case of agency, what will happen, my dear? In the profit and loss statement, correct, sales will be how much? Sales, if I write 5,250, that is wrong answer. What should be written? 250. Correct now. What is your cost, my dear? Cost, if you write that is equal to 5,000, wrong. Correct na? What is the entry you should record, my dear? Say I have received cash of 5,250. Correct na? To payable to Indigo. Yes, payable to Indigo, that is equal to 5,000 rupees. To sales or my commission income, that is equal to 250. Like that you are supposed to record. Correct? But what about Indigo books में? How does it happen? Indigo books में क्या हो जाएगा? Indigo books में what will happen, my dear? Indigo will be recording 5,250 as a receipt and 250 rupees as a commission expenditure. And they will have other costs. That is a different thing. This is gross accounting. This is called gross accounting. Okay. This is called net accounting. That is what is supposed to happen. Okay. Yeah, there was one question on in the past. Whether it is, what is that? Is it a, are you agenta? Are you principal? I think one or two questions relate. I mean, within one question only, he clubbed two questions and he has asked the same. Correct, na? Right. That's if I go to that respective, what is this area? Principal versus agent. Okay. See this question, final November 2020. Right. You can decide. Entity O negotiate with the major airlines to obtain access of airline tickets. Okay. Yeah, same, not exactly same. Here differences will be. You have to read the terms and conditions carefully. Will bargain with the airline tickets at a reduced rates. Correct na? I want commission. In the paper mein what will happen? 5,000 rupees will show. But we don't pay to Indigo company 5,000 rupees. I will pay to Indigo 4,750. Our balance money 250 is my commission. Could be like that. Okay, and it sells the tickets to the customers through the website. Through its website. Whose website? Customer, my party has got a customer. Na? What is happening here? Oh. What is happening? 1 second. Now entity O negotiates, that's fine. It is going to sell the tickets in their website. Means entity O will be selling in their website. Okay. Entity O contracts with the airlines to buy a specific number of tickets at an agreed rate and is required to pay for those tickets regardless whether it is able to resell it them or not. See, I purchase 50 tickets. At whatever rate agreed upon, I have to pay to Indigo. Whether I am able to sell 50 or not able to sell 50, that is my problem. Understood? Right. Customer visiting entity O website, search entities O's available tickets. Entity O has discretion in establishing the prices of the ticket that it sells. Correct na? If required, I bought it for 4,000. Correct na? I may sell for 6,000, 10,000 or 2,000. That is my wish and will. Now tell me, in this regard, entity O is a principal or agent? Principal. Why principal? Correct. Even though ultimately service is going to be done by the Indigo company, still with respect to correct na, right? Do I have risks and rewards related to the tickets, losses and etc.? Yes, I have. And pricing will be not depending upon the Indigo or something, depending upon this demand and correct now, whatever the reason, I will be able to fix. I have got a control over this. That's why correct now, entity O is a principal to recognize the revenue on the gross basis. Understood? Not like a agent. Next, entity O is responsible for delivering the ticket to the customer. Entity O will also assist the customer in resolving the complaints with respect to services of the airline. Okay, airline is responsible to fulfill all the other obligations. Yes, that is, we have a separate agreement with the airline. You should take, but if you face any problem, you can contact me. I will contact the airline. But normal agent, what will you do? I booked a ticket for you. Any problem, don't call me. You contact Indigo. But here it's different. I am there standing for you. I'll do all those kinds of services, whatever is possible. You can contact me, I'll contact Indigo and I'll get it done for you. I'm responsible ultimately to you. Hello, understood? Is he not principal here? Obviously principal. This is one question asked. But to answer this, my dear, here E conditions you should be able to remember. Okay. The following are the indicators of an agent. If your agent means indications for agent. This is indications, not conditions. All 5, 6 need not be satisfied. Majorly satisfied also, you can close it. Okay. So the another party is primarily responsible. I will not do the job. Indigo only will take you from Bangalore to Delhi. Correct? Na? Done. An entity does not have inventory of risks and after goods. But in this case, the above example, entity O situation, what has happened, my dear? I have the risk. Correct? Na? If I am not able to sell within the time, then it's a loss to me. Agree or not? Yes, exactly. Entity does not have a discretion of establishing prices. No, I have establishing prices. That's why I'm not agent, I'm trying to tell. Entity's consideration is in the form of commission. No commission from the airline company. Correct now. A difference amount is only my commission, that is not decided by the other party. Entity is not expected a credit risk. This is not a question here because people was to pay. Credit risk is not. So majorly, correct now, majorly all these three, it is not relevant point. These all three is not satisfied. You are not an agent, you are a principal. Correct now. If your answer consists of at least few of the points and say that, key points also now coming from this only. Questions are there. You just need to draft it properly. Hope you understand. If you draft it perfectly, then it will be easy. Then next point. Come to this above question, my dear. Warranty related. This is something important. They have not tested so far, but yes, it should be tested maybe soon. Warranty. Listen carefully. Warranty, you guys do purchase mobile, correct na? You purchase laptop or at least somebody is purchasing, correct na? Right. Warranty, two types of warranty. First year warranty will come along with the product. But that warranty is what kind of warranty? If there is a manufacturing defect, the other party will solve, correct na? Suppose sir, my mobile slipped and broken. Will the warranty work? No warranty. System should be intact, proper. Something is not working inside, then our person will do it. Correct na? Are you getting my point? Next, one more thing. Additional warranty, if you want, you can buy. Do you agree? Correct na? For iPhones or big, I mean expensive things, what will happen? Generally, they will say additional warranty, 2 years ka 20,000 rupees also they will keep it. Because first year warranty will come from company. Second, next 2 years warranty will come from. Exactly. Are you getting my point? That is the matter. Now here, if first year, correct now, first year warranty whatever comes, that is a defective, manufacturing defect something is there, That is not a separate concept. That is not a separate performance obligation. That will be dealt by Ind AS 37. That is a provision for warranty should be created. Are you getting my point? But when I say mobile kharido, 1 year warranty it will come along with the mobile. Another 2 years warranty hai. If you wish, you take it. Correct na? Now it is a separate performance obligation. What is this? Separate performance obligation. People can buy this only, or they can buy this only. Correct na? Yeah, today I don't need to buy, later also I can buy. Correct na? If without buying this also, this will work. Correct na? So this is a separate product, correctly speaking. So what are you supposed to do? Whatever the money has come, that has to be allocated between the mobile plus warranty separately. Then in days 115 ko you are supposed to come. Are you getting my point? Come to the point where whether the customer has an option to purchase the warranty. If you say no, whether the warranty provides any service in addition to assurance, no, only service karenge. No assurance means breakage assurance, water mein dal diya to still I don't do any assurance, such something, nothing like that. Product warranty is simple, correct? Under that circumstance, it is Ind AS 37, that is a provision for warranty, provision supposed to be created, that's all. Now look at this point, my dear. Whether customer has an option, yes. If you say yes, that means it is a separate performance obligation. Correct now, total transaction price has to be bifurcated between two performance obligations, that's all. Again, if you say they are doing something more, correct na, not just only product technical services ni, correct na, they will give you for, if it falls in water, still they will give the guarantee for it. Are you getting my point? If there is a brokerage also, actually there is insurance product. What is it called? Agree or not? It is insurance product. If it actually leads to insurance, Ind AS 117 is supposed to be applicable, but that is not mandatory till date in the country. Our standard is not there in the syllabus. It will not be there in the syllabus. Don't worry. Okay, right? Because that is a sectoral business. I hope you understood. Because there is insurance involvement is there, right? Otherwise, it is a performance obligation, separate performance obligation. Yes, you identify two performance obligations. Bifurcate the total amount between these two performance obligations. Is it clear, my dear? Warranty है तो ऐसा करना पड़ेगा. Consignment is normal consignment. I'll try to deal with one more thing, right to return. Correct na? Which you know it already, but still I would like to explain it to you. Okay, right. And one more related, two more concepts I would like to deal, which is asked in the exam or can be asked once again in the exam. Right? Will we go ahead? Right. So agent wala over. Non-refundable upfront fees and all, simple. These are all unexpected rights. Repurchase. Okay, 1 second. Sale with a right to return. This is also some important concept, my dear. I think it has been asked already in the past. It has been asked. Okay, this is one good question, no doubt. Sale with a right to return. This you may be knowing, but still I would like to revise this concept because it's important considering. Listen carefully. What is that? I sold, example, I sold say 1000 items, I sold it in the current year. Are sold in the 1000 items in the last month, say example March month. Only March month sales I am talking. Other months sales are different. Why, sir? Means I give 1 month right to return. 1 month right to return to the customer. Are you getting my point? So till February sales, his rights must have already been expired. Yes or no? So the problem is only with respect to March month sales. March month sale, how many items you sold? 1000 items you sold. Okay, what is your selling price, sir? Selling price is equal to 100 rupees. Simple example, I'll take it. Correct now. So what is my sales number? Sales is equal to 1000 units and 100, that is equal to 1 lakh rupees is your sales. The example, what is my cost? Cost is equal to 80%. Okay, so in my COGS, I'll say, correct now, I say COGS is equal to 80,000 rupees is my COGS. Agree? Correct. Now, what is that? You have given 1 month of right to return or not? So what will happen? Anybody can come and give, right now. So now if I say, sir, there is 20% chance, correct now, 20% chance to return the product. That is your business is talking about that, correct now. Business is giving you information, approximately 20% of those items can come back. Now what the standard says, my dear, tell me, where are the items? First thing, items are with whom? With the customer. Physically, is it sitting in your go down? No, means it is inventory 31st March, I verified physically. Is it there? Not there. Hello, correct? Point to be remembered, it is not part of the inventory. Now, what should I do? What should I do in the profit and loss? Otherwise, I'll say like this. Your accountant would have passed one basic journal entry. What is the journal entry you would have passed, my dear? Cash account debit to sales. How much number? Full 1 lakh rupees you must have recorded. He must have recorded already. GST invoice. Okay, na? But standard will tell what? Record only to the extent of 80%. Hello, correct? Record only to the extent of 80%. Hello, correct? That means what should I do now? To the extent of 20%, are we supposed to reverse or not? Reverse to the extent of, to the extent of 20%. Tell me, what is the entry you should record? Sales are going to be debited. Yes, no doubt. Sales going to be debited by 20,000 rupees to what? Obligation to pay. Correct na? Obligation to pay. Return. Correct na? When they return, do you have an obligation to pay 20,000 or not? When it is no more sale, then money collected is like a loan for you, na? You have to pay the money. Agree? Yeah. This is first point number 1. Next, at the same time, sales to you are not recognizing, but goods to yours only, na? When it is not sold means goods should be yours. Goods are, you must have already charged to goods 80%, no? Yes or no? That's why what are we supposed to do now? Do you have inventory? Who is the owner of inventory now? Customer is not the owner, I am the owner. Because sale is not completed means still I am only the owner. Na? Bring the inventory to the books of account or not? Inventory with third party. Kya bola? Yes, obviously. So what are you supposed to do? Inventory with third party. Yes, outside. Correct. Now inventory with third party account debit. How much number? That is equal to, out of 20,000, 80% is my cost. Correct. At cost. Cost or NRV rule will be applicable. 2 purchases you can book, because you must have already booked the, correct na? Purchase 16,000 rupees. A number you are supposed to book it. Have you understood? That's all. Concept over. One is refund liability you are supposed to create. We created obligation to pay is called refund liability. Standard says use the word refund liability. Liability basically. When he gives me the item, I have an obligation to pay. But at the same time, I have a right to receive the goods also, no? I have a right to receive the goods as well. Then only I have an obligation. Correct, na? You purchase some Amazon item. When you want to return, what that Amazon guy will do? Whoever come to pick the product, first he will open. Everything is tick-tock. Correct, na? Including the sticker also. He will see. Correct, na? There is one tag is there. A tag missing means he will take back. He will give it back to you only. Understood? Yeah, he will check everything. Correct, na? Item tick-tock hai. Tag also correctly intact, it should be there. Then he will take the item. Suppose, yeah, it happened for me one time. Like I got one bag. Iska tag I removed. Okay, tag I removed. He did not take that. Luckily, what has happened? Removed and kept in one of the packets only. Then I called and told, no, it is there, my dear. Already tag is already there. So then he accepted that. No, they will not take. Their rules, they're correct. They will have already 1, 2, 3, 4 items. Ka checklist will be there in the mobile. Tag idea, ide tick, idea tick, correct na? You should put all the ticks, then okay, then go with accept. And he has to take the picture of that attached to the each one. I checked, not only just checked, I have attached, I have taken the picture of it. Done. Okay, now return will be presented. Everything correct na? Everything has to be in perfect manner, then only they will agree to it. Fine. This is the simple accounting with related to this point. Yeah.
Next, bill and hold. This also they asked once, I think. I'm not very sure. Right. But it is very good concept and important concept. What is this concept, my dear? Bill and hold. What is bill and hold concept, my dear? Billed means invoiced, but item is held by me. Goods are sitting at my godown, but still I invoiced. I can recognize the revenue. Can I recognize it? Yes, you can recognize it. First question. Okay, first point is what? Why are you holding? I am holding at the request of the customer. Okay, so at the request of the customer, first thing, at the request. At the request of customer, you are holding, not just not at your decision. No. Right. Next, second thing, you are holding, correct? Right. Next, it should be what? Packed. Goods should be, yeah, goods should be packed. Goods should be identified. Identified word should have come first. Packed, identified, ready to ship. Okay, ready to ship. Are you getting my point? Suppose, my dear, I am selling AC. There are 10 AC boxes are there. ऐसा नहीं है, ये AC correct ना, ये 1 2 3 related to you. Identification करना, kept it aside. Once you send your lorry or something, whatever it is, van, no, I should be able to put it in the van. That's all my job is done. I'm just waiting for your van. You said I will send tomorrow, sir. Today not possible. My vans are busy. Not a problem for me. Correct, na? Right. Third is important. Packed, identified, ready. Correct, na? I do not have no right to redirect the goods. Redirect to another customer. Means selling. Another customer. Are you getting my point? What did I say? I am a bailey. In simple language, what am I? Bailey. Bailey means what? I am a security guard for the products. Items mine? No, items are not mine. Correct na? Suddenly somebody, this guy will come. This is kept for you. You said like after 10 days you will come. Okay. Suppose now this guy came, sir, I want this item, sir. I'll say no stock. Why are you telling sir no stock? Here I have 3 items. I want these 3 items. I will take these items. Na. Next lot will come, no. In next 2-3 days. A lot you give it to her. If he says like that, if my answer is no, my dear, I cannot do this job. If I say that, sale is done. If I say no problem, you take this, I will supply to her another lot mein supply karega, means what? Still I have the rights over the asset. That means sale is not completed. I hope you understood. E condition, right to redirect. We don't have any right to redirect it to another customer. If you say so, then I hope you understood. It is perfectly all right. Otherwise, sale cannot be booked. If you satisfy all the 3 conditions, then you can book the sales. Is it clear? Can we go ahead? Right? So, this is done. Warranty we spoke. Correct? Na? Principal versus agent we spoke. Non-refundable upfront fees. Amma. This is non-refundable upfront fees. No? They have never asked actually. Question is simple. Ma. School is there. Okay, for kids. Okay, what do we do? When we join them in the school, do we give some donation? Donation will give. Say example, 2 lakh rupees donation I give. Plus 1 lakh rupees for the fees. Fees will be paid in advance. No? School fees, mostly advance may will pay. Correct. 2 lakh plus 1 lakh. 3 lakh rupees. Correct. Na? If 1 lakh ka discussion is not there, that is related to current year fees. What about the 2 lakh rupees? Suppose if I say, I am transferred to Hyderabad, okay, give me my 2 lakh rupees refund. Refund nahi deta. That is what? What is the sentence? Non-refundable upfront fees. That is donation. Right? Question is simple. First you should ask, one should ask, with respect to 2 lakh rupees, Ravikant, customer, do you get any services? Kya bola? I will not ask back, I agree with you, but do I get any services? For example, Club Mahindra is there. What is there? You heard Club Mahindra? They have got big properties all over the world, India. We can go and stay. Hotels basically. Okay, some resorts will be there. Correct. Now you will be paying some 10 lakh rupees for membership. Every year also you will pay some small money, maybe 20,000, 10,000, something like that. They will give 10 days or 15 days of your time. So what you can do? You can go with the family.
2 days or 3 days, whatever your planned time, you can spend and come back. You go to, suppose say, not Delhi or something, like say Kulu Manali or something, I mean tourist place, then maybe their property will be there. Then you can contact them, I am coming so and so date, book karega. That is how it happens. Now, first time you paid how much? 10-15 lakh rupees you paid for membership. Is it refundable? Non-refundable. How should they book? Club Mahindra should book. You understood question? Correct na? First question. For that, do they serve me? Yes, they should serve me. They should give me the room. Correct na? That time they will charge something. Small money they will charge. Still, even though I paid that much money, still 4,000, 3,000 rupees per day they will charge. But actually their room rent per day is equal to like 15,000, 25,000, 50,000. 1 lakh also will be there per day. 3,000 rupees is just a basic charge. Okay. So are they serving you over the period of next 10-15 years ka commitment de diya na? So that money of 15 lakh rupees will be kept as a advance received from the customer. That should be transferred to the P&L over a period. That cannot directly go to reserve. That's why you need to look at the terms and conditions very, very carefully. If there is no service to be done, example, I don't need to do anything. Got it my point? Then transfer it to P&L immediately. It depends upon contract to contract. License is a small job, Nana, that you can do. Unexpected right also is nothing. Okay. Yeah, unexpected right, this you can try at home. Fine. Unexpired, unexercised right. Some customer, this you can try at home. Okay. I will not discuss. Fine. Unexercised right is something important. Repurchase agreement and all is fine. Not a serious thing. Fine. Yeah. One time, if I remember, I don't think so. They asked this question, my dear, by chance? Service concession arrangement. One question, it was there in the institute material may hai, no doubt. I don't think so. They have asked. Have you heard this concept by chance? No. Huh? But I don't know. This is asked in the RTP na, or asked in the exam. I don't know. Or not asked, only examination. Only kept in the. But if this comes, it will come for not less than 12 marks to 16 marks. If this comes, not less than for 12 to 16 marks. Okay. Because concept is too big. Right. I'll explain you overall concept. I'll explain. But you should try the sum. Okay. Try to catch the service concession arrangement. Okay. My dear. So when I say my dear, this is service concession, correct na? Service concession arrangement. Best example to put the concept in your mind. Best example to put the concept in your mind is toll road. Toll. Okay. Roads. What is your company? Listen. Okay. This is my company, is a construction company. Say L&T is my company. What is the job? First contract में क्या करना sir? Contract में first lay down the road. Lay down the road. Okay sir, I'll lay down the road. For this I am supposed to spend how much? Say 100 crores or 1000 crore rupees I am supposed to spend, something like that. Plus, what is that you are supposed to do? Maintain the toll. Maintain. Okay na? Toll. For 15 years or 20 years karke I will tell. This is public government ka business. I mean where government do not have the money. They will give it to L&T. You construct, you develop, and you only take the toll money, whatever comes in, you take it. Right? So what do? In this road, how many people are traveling approximately? They will have their own analysis. They have to gather the data. Okay. So how many four-wheelers or trucks or something. Estimation karna ma. Just simply like that, I cannot go into that one. Suppose you put 1,000 crores of money. Nobody is traveling in that road, means gaya no loss. After 20 years, road will be taken by the government. Next year contract may come to you, but further you have to pay separately. No, it will not come freely. Correct na? So this you have to maintain the 20 years of that. Right now, first thing here you need to understand. Here two contracts are there, my dear friend. What are there? Two contracts. First, constructing the road is a separate contract. Are you getting my point? Maintenance is a separate contract. It's like that. Supposed to read it. Hello, understood? Listen carefully. Normally, here you are supposed to observe. Normally, normally. What do I do? Construction business mein, when I construct, right, 1 kilometer will take it. One kilometer road if I construct, some money will be charged or not? Are you getting my point? Say example 10 crore rupees per kilometer I will charge, sir. 10 crores I will charge it per kilometer if I lay down a road. Nothing wrong. Right. Here, this is your cost. What I told is what? Cost. Otherwise, if I say my selling price is equal to cost plus 20% is my selling price. Kya bola? Cost plus 20%. So, first thing, assume first year mein road is completed. Aisa socho for the time being. Okay. First entry, what should happen? I have to book the sales. Sir, where sales? Yeah, my construction is done now. Okay. For construction is done for what number? 1000 plus 20%, that is equal to 1200 rupees sales will happen. But are you getting, is the government giving you 1200 crores? Chiller also they will not give. Correct na? Sometime it can happen, they will give partly, they will not give partly. It will happen all the ways. Okay. Suppose example, okay. Suppose example they gave, sir, they gave cash of 500 CR, they gave. Maybe possible. Receivable or received cash. E money, balance money 700 is there na? E number is nothing but intangible asset. Kya bola? Why intangible asset? Have you got the right to run the toll? That is a license. Like the license to run the toll. Hello, understood? First, this is when the construction completed. Yeah, you can book here also percentage completion book kar sakta, nothing wrong. Every year percentage completion book kar sakta. Okay, because the other party has given already a contract, mandatory contract, he cannot take back the contract. So, you will satisfy percentage completion. I don't have an alternative use. And again, I am constructing on whose land? Is it my land? Road is yardu, government land. Correct? I am constructing at customer side. Na? So, second condition only it satisfies. You can book it. Percentage completion mein book kar sakta. Okay. Now, 2 sales perfectly done. Now, next year onwards, say this is 3 years mein you have completed this job. Now, 4th year onwards, what will happen? Do you get the sales? Toll commission will come na? You will travel, you will pay 100 rupees to go and up and correct na? So, then what will happen? Cash account debit to sales. This is the toll income. This is the toll income. Correct? Next, intangible asset is supposed to be amortized over the period of 20 years. Agree or not? Yeah, intangible asset, correct. Amortization expenditure, amortization expense account debit to intangible asset. Correct? We will be amortizing it. That is how overall the concept. Overall, have you understood? Okay, right. So, with this, I am concluding Ind AS 115. Okay, we'll spend some time on the Ind AS 116. That is sales for the maintenance kit, because only for a maintenance. That time sales is there, intangible asset expenditure also will be there, no amortization expenditure, maintenance expenditure also will be there. Road I have to maintain, no? Correct. Big expenditure is amortization of E700 wala amortization will be there. My maintenance road will be for the rains and etc. Road will be kharab ho jayega. Then I am supposed to make it proper. Correct, na? I'll have a lot of expenses, not only collection. Fine. Right. Hello. Let us start Ind AS 116. That is leases. Okay. Ind AS 116 leases. Right. So, first, this is from the exam point of view also very important standard. From the practical angle also very important standard, because
Nowadays, like any company you go, they must have taken at least their office building on lease. Correct. I mean, most of the companies, from top company to small company, you will find the rental agreements, which is normal. Okay, which is really normal. So, which practically you are supposed to apply. Correct. One bank, this is related to Northeast Bank. Okay, you know, I mean that formula I also don't know, that Excel ka expertise. Every lease ko you have to find out ROUA, you have to find out lease liability, and till date that is the balance also. What is the depreciation? What is the interest amount? Correct, na? You know that expert guy, I don't know how they did. In one line one row he completed everything. And you know, 240, 50 number of leases were there. Everything is in one sheet. A formula also I couldn't understand what is this. I mean, it's a so big formula, but if you just give the date, correct information, if you put it in the first few columns are available for input. Next few columns you can't insert also. You can just see the formula, but you can't change modification because it's protected perfectly. It will come. When it is so many number of leases, it's a bank, no? Okay, it's a bank. So many branches they have got, office buildings they have got, regional offices they have got, district wise some office will be there. Correct, na? So many leases you have to account means that time it will become difficult. Like without a software, he made one small software in one sheet. Right. Anyhow, we checked how to audit that. That was the question. Correct, na? We don't know formula first of all. It's okay. First we took then some sample 10 leases we have taken in our fashion. Correct, na? One lease in one sheet mein dal diya. We put the numbers and okay, answers are matching, exactly matching. So that means that formula is working perfect. Output method we have applied. Output is correct, then fine, formula is okay. Correct, na? Input is correct, we check. Output checked for 10 leases. 10 samples we selected. That's fine. That is pretty comfortable. Right? Where sometimes we only got a small error. They have not got error. I mean, maybe round off, number of days, +1 -1 something, number of days, R date minus E date +1, we should apply formula. Correct. Sometimes we must have missed out +1. That's why difference will come. But there it is correctly applied. Or fine. That's a different task altogether. Chalo. Leases. First, lease means here, my dear, lease means it may be even rental also. Correct, na? Rental agreement plus lease. Lease means in Bangalore or Karnataka, mein, what do you say? Lease in the sense, we'll give lump sum money. Correct, na? We'll take this building on lease for 3 years. After 3 years, lump sum money will be given by the owner, will give back to me. Correct, na? That's all. We'll vacate the place. Agree? Right. So this is the basic lease. But rentals also lease only here. This agreement is meant for leases, rentals, everything is part and parcel. Okay, right. So first point is right. Next, here very important concept here. Leases accounting is going to change from lessee's angle and lessor angle. Correct, na? If you see lessee angle is what? All leases are same. All leases are same for lessee. Right. Oh, same accounting treatment will continue. Same. It is all leases are same. Whether it is a land lease, whether it is a building lease, whether it is a ship lease, whether it's a vehicle lease. Lease, yes, it is same. Accounting will not change. Accounting will not change. So what is that you are going to recognize? We will recognize ROUA, that is right of use asset account. Debit to lease liability for the time being. Okay, to cash by cash and other things also will be added over a time. But basically, we'll recognize the right of using the asset and our obligation to pay. Correct, na? Will record. And except there are some two exceptions. There are two exceptions are there. Correct. What are the two exceptions, my dear? One is what? One is small value assets. I mean immaterial small value item or small value assets. Okay. I mean immaterial value wise. Correct, na? For big companies, they will purchase the laptops. They'll take the laptop on lease. What is the worth of laptop? 75,000 to 1,50,000 rupees le lo. Correct. Working laptop 1,50,000 maximum. 1,50,000 rupees for my company, is it a big number? Not a big number. Correct. My company turnover kitna? 30,000, 40,000 crores. You understood my point? Is 75,000 kya kaha rakhna? You understood my point? My numbers in the balance sheet only crores. How many laptops together will come to 1 crore? You understood? So where to put 1 crore also there? How many laptops? Correct? Now, why should I maintain? So it depends. Materiality it is depending. So if it is a small value item, I don't want to create ROUA asset. I don't want to create. Okay, but maybe considering the what is that all major numbers, if put together, if it is going to become big number, then I may look at it. Fine, that is a professional judgment. And second one is what? Short term. Short term leases, right? Short term leases. Yeah, here again one point you should understand. Small value, no? Right? If it is a short term lease means what? If the lease period is equal to less than or equal to, correct na, 12 months. Period is less than or equal to 12 months. So when it is less than or equal to 12 months, I can say I don't want to follow your ROUA concept. Agree? Right. If it is a short term lease, no, my dear, this is obviously an accounting policy choice. What is this? Accounting policy choice means what? For one lease ko I will follow, another lease ko I will not follow, concept will not be there. If you decide that we want to follow for 12 months, 12 months ko I don't want to follow. That's all 12 months ko you should not follow. Got my point? Right. Now here all short term leases, I will say all short term leases, correct na? Do not follow. That's all. All short term leases ko do not follow Ind AS 116. Do not follow 116. Very simple concept to close. Sir, small value. Which is small value, which is big value is left to you. Are you getting my point? Yeah, here identify. You can identify item by item. Identify item by item. Correct na? I can say, one server ko I want to follow, laptop ko I don't want to follow. It is left to you. It is left to you. But with respect to 12 months concept, nothing left. You don't want to follow, don't follow. Understood? But you have to observe carefully, my dear. Okay, right. A big building I have, correct na? One question has come. One interview mein, one EY interview, that EY partner was asking to another, that girl is my student. So after interview, I mean, she already qualified and she got some 3-4 years experience, and then she attended interview. I was generally asking what were the questions, what was asked, correct na? I know her for so many years. So a question has come. Okay, example. What is the question? That partner was asking, land is given it on, correct na? Land given on rental basis. You are taken, I mean, you are a lessee na? Land is taken on rental basis. What is the period? Period is equal to 12 months or less than 12 months. Getting my point? Hope you understood. Other way around. So can we exempt? First question number 1. Just I am elaborating, like I mean telling you. Land is taken on. Correct. Can we exempt this? What do you say? If it is for 12 months, no, you can exempt, even though it is a big value. Value is not necessary there. When it is a period is short term, that time you should not look at the value wise. Value is a big number. I hope you understand. When you are looking at E line, don't look at E line again. Land wise value may be big number, but I am looking at term. My policy is what? I don't want to do it for a less than 12 months policies. I don't want to follow your 116. Don't follow. Now immediately next question should come. Okay. What is the next question, my dear? For this, what is the accounting? What is the accounting you will follow? You have to follow SLM method. You have to follow SLM. SLM method of lease, correct? Rentals. Yeah, SLM method mein what will happen? You may get a deferred rental concept. What is this will come? Deferred rent. Okay, what is deferred rent? SLM, suppose it is a small value item, correct na? Small value item. Say example, laptop is a small value item to me.
right? So example 1, 2, 3, correct? 1, 2, 3. 3 years I am taking a laptop on lease, right? First year maybe 25,000, next year 35,000, next year 30,000, something like that. I'll keep it. Got it? Yeah. What is your total, my dear? 0, and this is equal to 90. Correct na? 90,000 divided by 3 years. That is equal to how much? 30,000 rupees per month is my rental expenditure. Correct? So what is that you are supposed to book, my dear? You have to book rental expense account debit. How much are you supposed to book? That is equal to 30,000 for first year, second year also 30,000, third year also 30,000 only should book. Okay, but sir, whatever I paid. So first year how much I paid? First year I paid 25, next year 35, next year 30. So year to no problem, 30 you paid. Correct na? Year what you paid? This is going to be deferred rent account. Deferred rent is equal to 5 here. Deferred rent account will be debited by 5 here. Understand? Whatever excess plus or minus whatever you did, that is going to be deferred rent account. May will transfer. That is SLM method. Hope you understand. This is how it will happen. For leases, every lease, everything you are supposed to account for leases. Understand? Next point. Next point is what? Lessor. Correct na? Lessor books of account. When it is a lessor books of account, what is that you are supposed to do? You are supposed to classify the lease. You have to classify the lease. Into what, sir? Into, as usual, operating lease and financing lease. Operating and financing lease. Finance lease. Correct na? How do you classify? How do you classify? That is based on the risks and rewards transferred. Correct na? Risks and rewards of the ownership. Risks and rewards related to ownership are transferred or not transferred accordingly. If it is transferred, then it is going to be finance lease. If it is not transferred, it is going to be operating lease. Like that, we will classify the leases into operating and finance lease. This is exactly same as accounting standard 19. Okay, if you remember by any chance, same concept, same condition, same wordings, same, everything is same. Okay, everything is same. Now let's come to the, now what is that we are supposed to come? We'll come to the leases. Correct na? Right. So here lease is what, my dear? Lease is a contract. Agree na? Lease is a contract. Contract means obviously there will be minimum two parties will be there. Correct na? Those parties only are called lessee. Correct na? And that is nothing but lessor. This contract is for what, my dear? This contract is for transfer of right to use. Transfer of what? Right to use. Right to use. Right. The beautiful way what he says na, it is a contract or it is part of a contract also, he will use the word. What will he say? It need not be one full contract. Lease agreement karke heading not required. It may be heading, may be sale of goods agreement may be there. What will be there? Sale of goods agreement will be. But under the sale of goods agreement, there can be some lease element can come out. That's why a contract or a part of contract where the transfer of right of use asset. Correct, right of use asset, that should be transferred for what? For a certain period of time, obviously, and for a certain consideration. Yes, this can be there. It is for a period of time and for a consideration. Yes, if that so happen. You getting my point? That is going to be lease agreement. Now here, point to be understood, my dear. Right, asset. When I say asset number, asset should be identifiable. It should be identifiable asset. Specific asset should be there. Nanna. Agreement mein kya hona? Correct na? Car lease. When I tell a car number, chassis number also should be there. Ya car. Got my point? Which car? A car is not, I don't know, whichever car you want. Then this is not a lease agreement. You understood my point? Say example, my dear. IndiCube is there. What is IndiCube? Co-working space. Correct na? Say example, co-working space. Example I am telling. In case of co-working space, there are all the ways are available. Co-working space may suppose if you want, sir, I want 2 employees ka co-working space. Where should our people, two people should sit where? Sir, this is the hall, third floor. E hall mein wherever you have space, you go and sit, sir. If they say so. Are you getting my point? What did they say? Wherever seat is there, you just go and sit. Got it? Then it is not a lease. Why? Where have you told what is the space? Which space? Correct. Na? Identification nahi hai. Wherever you want, you sit it. Correct. Na? So that is not there. Are same co-working space mein, if they say, they bifurcate the floor. Correct. Na? A small area, here 3 seats can come or 6 seats will come. A small area related to your company. Identification has done. If it is identified, yes. If it is identified, then lease will work. This amounts to lease. Are you understanding what I said? Correct, na? Then it will work to lease. If it is not identifiable asset, exactly the name, what is the space, which building, which floor, correct, na? E corner is mine, this corner is mine. Aisa identification to hona padega. If it is not so identified, then it is not going to be called as lease. Understood? Right. Chalo. But sometime what happens? Okay. It looks like it is a sale agreement. What is that? It looks like sale of goods agreement or sale of services agreement. But it may not be exactly sale of goods or sale of services. Example, ma. Example. Okay. Right. I'll say I'll enter into such contract. Suppose one biscuit factory is there. What is there? Biscuit factory. Okay. There is a biscuit factory. Fine. Right. One second. Minute. Okay. Yeah. Hello, my dear. So, what is that I was telling? Biscuit factory is there, ma. What will happen? No, I'll tell you. Agreement is like this. Okay, you will see number of such kind of agreements. But correctly, whether accounting is happening is a big question. You have to, I mean, you should have the knowledge so that when you go there, then doubt will come. If you don't know there is such concept, na, then practically when you see also, it will not click to you. You understood my point? That's why first theory you should know. If you don't know theory, if directly practical I want to work on some Ind AS project, what you will do? Nothing you will do. One basic thing, I will give you a format, you will fill the format. Oh, I did. What you? Nothing you did. Correct. Now, if you know full standard, then ideas will come. What is happening? What question to ask? Correct. Now, then deeper. Correctly, I see. The maja of Ind AS conversion may maja of what? Where does the maja will be there? Not when you calculate IRR, not when you calculate lease accounting. Idhar mein maja nahi aata. One time I will like to do. Second time it will become headache for me. Correct na? Where do I enjoy? In identifying where are all the differences will come from IGAP to Ind AS in this company. You got my point? Analyzing. Suppose now your sales, you are accounting like this. No, as per Ind AS, it should be accounted like that. So then what is that you are accounting? Understanding your system. You got my point? What you accounting? What is happening? Identification is something important. Simply calculation. Where will it go? That's normal. It is, you will not enjoy that kind of thing after a certain point of time. Okay, right. Forget about it. Now the question is what? If factory mein what happens, agreement will be, suppose this is a X company ka, X limited ka factory there is there. Now my company is what, sir? My company is Britannia. Okay. Britannia need not have all the biscuit factories, need not be owned by them. What do they do sometime? They will enter into agreement with this company. Do one thing. How to manufacture formula, everything will give. What you should do? You should manufacture biscuits for me. Okay, na? Packets also, I mean covering everything will provide it to you. Pack properly and in this carton box mein rakhe, you should give it to me. Are you getting my point? Ingredient, kya dalna, what should put, everything. Quality checking will be done by our people and we'll do it. Hello, understood? Right. Now, biscuits, correct na? Okay. One biscuit packet ko example, one biscuit packet you manufacture, 8 rupees, I'll pay it to you. I may sell for 16 rupees, that is the second thing. 8 rupees you manufacture and get me the direct, readily biscuit packet de do. Understood? Now, is it a sale of goods or is it a lease agreement? Hmm? It's a contract, obviously is there. Contract to manufacture, correct na? If you say contract to manufacture goods means Ind AS 115 ko it will go, not lease, not 116. You should go deeper into this. You should ask, correct na? What is your company, what is your factory ka capacity? Capacity, say example 1 lakh biscuit packets per month we can manufacture. Agreement between Britannia and this says what? Full 1 lakh biscuits should be manufactured only for me. You should not manufacture for any other person. You understood? Agreement is what? For me manufacture. Don't manufacture for other party. Understood? Right. Quality, everything will be verified by me. Understood? Right. So indirectly, what is that you are doing indirectly? I mean, I have not completed the concept. Got it? But isn't it, if I take your factory on lease, what do? It will be manufacturing 1 lakh items will be manufactured for me only, na? Now what are you doing? Same thing you are doing, but it is your hand say you are switching on. Otherwise, I should have switched on the things. That's all. No, agree? There is a lease element plus you are manufacturing something. Entire lease 8 rupees ko I cannot take, but partly there is a lease is there, partly there is other than leases. Have you understood something? For that, a decision is supposed to take place. Correct na? What is the decision here? I can say one diagram. This diagram will help you. First, question number 1. Right. E kind of questions they have not asked, I feel, so far. But just thought of explaining one time at least. Is there identifiable asset? Yes. Factory. Which factory? We know. Identifiable. Done. So I will go forward. Does the customer has right to obtain substantially all the economic benefits of the use of the asset? Suppose if the capacity of the biscuit factory is 1 lakh, entire 1 lakh benefit should come to me, correct na? Suppose if Britannia says, no, 50,000 you manufacture for me, 50,000 you can manufacture for somebody else. Aisa bola to? It's a pure sale agreement, sale of goods agreement. Are you getting my point? Now in my example I said what? 1 lakh items fully you should manufacture as per my instruction, correct na? You should give it to me. Are you getting my point? Yes. So if it is yes, substantially all the economic benefits are going to be derived by me by using your factory. Agree. Now, who has the right to direct how and for what purpose the asset is supposed to be used throughout the period? Tell me, in my example, Britannia only has the right to know what to manufacture. What to biscuit? Yeah, biscuit. Biscuit means all biscuit only. Britannia is only one type of biscuit they'll manufacture. Correct, na? Biscuit with so many different brand. I mean, names are there, na? Yes or no? Biscuit with nuts, without nuts. Correct, na? Right? So many 1 to 10 items will be there. 10 items or 30 items. I don't know. 30 items may be there. Out of this, which one to manufacture? Will you decide or will I decide? I will decide. Britannia will decide. Correct, na? And next, how many quantity of this? Who should decide? I will decide. Arey bas 30,000 packets you manufacture. Okay, with nuts. 30,000 items with cream. Something I'll keep. Whatever the models may, I will tell. Correct, na? I will decide that. Who is deciding? If the factories comes to me under my control, what I will do? Whatever I want to manufacture, I will manufacture. Now also what is happening? As per my instruction, you are switching on and you are manufacturing. Is it at your decision or is it my decision? My decision you are just following. Correct, na? See, for what purpose of the asset to be used and all, it's decided. If it is by the supplier, then there is no contract. Supplier means you. Correct, na? Customer means Britannia. But you are selling it to Britannia, na? Britannia is a customer. You are the factory owner is a supplier. If it is with customer, then obviously there is a lease element. E predetermined is not applicable if you are while making the asset itself is made as per my rules and regulations, right? That is not applicable every circumstance. Okay, understood? That is actually under such. That's why agreement ko you have to read it very carefully. Agreement may hota everything. Okay, agreement correct. That's why agreement top of the agreement they will say sale of biscuits करके लिखेगा. Sale of goods agreement 115 को नहीं जाना. It is a partly and 115. It is partly 116. there how much is amount of lease and how much amount is this, you have to do it. And again, tell me Nana, one small common sense thing. If you are a factory owner, correct na? What do you expect from me? Quality is different. Quality you should produce. You should expect from me what? Sir, I will listen from you whatever you want. My factory capacity kitna? 1 lakh. Minimum order, whether I manufacture, do not manufacture. At least 80,000 biscuits, you should give order. Yes or no? Otherwise, you are correct, na? Otherwise, if you give only 20,000 biscuits and don't use it, means you are giving a variable number. One biscuit packet ko 8. If you use it only 80,000 capacity khali hai, I have to pay for labor, I have to pay for my other expenses, overheads, fixed overheads will be there, na? Understood? So, a factory owner, you are not behaving like a owner right now, I know. But if you are really owner, what do? If I am giving an order for 80,000 or above, or at least minimum 80,000, that means if Britannia gives an order for 60,000 in that period also, still I have to pay for 80,000 ko pay karna. Minimum order, minimum, correct na? Then only you will listen to me. Otherwise, you will say, not, I am sorry sir, I will not listen to you, correct na? That time sale of goods will happen. Minimum guaranteed amount is going to come na. So then out of that means 80,000 into 8 pakka vasool ho jayega. Plus X only can come, but minimum 80,000 will be coming. So from there you are supposed to bifurcate lease element. You have to identify raw material ka, labor ka, other overheads ka cost also you are supposed to identify. Correct na? Plus lease also separately identification. That level one question I kept it here. In the summary is there, in the book it is there, but not required at your level right now. Okay, but not now. After writing exam, just have a look at it. It will be, I mean, you will get knowledge. Knowledge will come. But when you know that what is the concept is happening, na, you will apply it properly. Okay, otherwise what I told, na, sale of goods hai, they are raising the invoice, GST correct hai nahi hai, you will see. Correct, na? Not exactly. Is it really sale? Is it really 115 or 116? That doubt only will not come. Hope you got it. Right. So that's why I just mentioned. Right. See that later, not now. Right. Chalo, my dear. So now we are going from the lessee books of account. Okay. Lessee books of account. As far as no, my dear, so far, all the questions have been asked from the lessee point of view, lessor point of view. They have not asked. One time they asked with respect to sale and lease back, one question has come. Okay, one time it has come. But subsequently, only lessee point of view has come. Lessor point of view, because accounting standard 19, since he has already tested at your CA inter level, maybe that may be one of the reason he is not testing. Okay, let's not focus in the marathon, may not focus from the lessor angle. Let us focus on the lessee angle, plus sale and lease back also I will cover it. Okay, that is also one beautiful concept. Some 15-20 minutes lagega. One sum will solve it. Will solve one sum. That give you clarity of the subject. Beautiful concept. It took some time for me to digest. Yeah, seriously. I mean, calculation milega. A by O karo milega. Why is it? What is happening? To understand the concept, it took some time. It's not like suddenly it is. Somebody explained, it will come easily. You only have to find out, then it will take time. Agree my point? Yeah, everybody video में क्या करके A by O करो, O by A करो. That I also do. That is given in the solution. What is that you are telling? Not that way. Why? What exactly? Why should I follow them? Correct na? And when IASB has given, correct na? IASB, International Accounting Standard Board, has given something. Already so much brainstorm has happened there. They will not give so blindly. They just follow karke. So there must be logic. First trust. Correct na? बाद में you obviously think, then you will find the beauty of it. Chalo, my dear. Let's see books. As I told you, correct? Everything is going to be based on first, all the leases are same accounting treatment, no change in the accounting treatment based on the asset or based on anything. Agree? Yeah? Perfect. Now come to the question. First, what are we supposed to determine? First, what is the lease liability you are supposed to determine? What is that you should do? First determination will happen lease liability. LL, short form. Lease liability. What is lease liability, my dear? Lease liability is nothing but present value of the future lease payments. Present value of future lease payments. Correct? Right. Sir, when I say lease payments, which one are you supposed to consider? Which one are you supposed to consider? The fixed lease payments you are supposed to. Fixed lease payments, Amma. Fixed lease payments, not variable lease payments. Okay. Sir, variable also can we consider? You can consider, my dear. Variable can be considered. Variable only when linked to what? Linked to, what do you say, inflation rate. Linked to inflation rate or any other rate. Any other rate. Then we will consider. Okay. I will say, what is the lease rent for the current year? 20,000. Next year, 20,000 plus inflation rate for the current year. That next year. That next year ka inflation rate add karo. You understood my point? It is variable only, na, but it is linked to some rate or index. Okay. But again, listen, it is not linked to, correct na? Sir, linked to performance. Linked to performance. Performance in the sense, sir, linked to sales. Correct na? Linked to profit. That lease amount will not be taken for calculation. Okay. Right. In one of the apartments, okay, big society, say almost 2000 flats are there. Okay. So what is that point here? There is one small, what do you call, store is there. Correct na? And big apart, so many thousand houses are there, 2000 houses are there, means some store will be there. Correct na? What is the store for? I mean, people can come, all items will be available. Right? So provisional items, all provisional items will be there. Anything you can buy and go. Now, what is the rent they should fix? I'll give you 1 floor or half floor, something like that, to keep the things. Right? What is that? Owners quoted, you pay me 5 lakh rupees per month, something like that, they told. This guy, store wala, he told, no, sir, it is very difficult, 5 lakh rupees. Why means? I will pay 5 lakh. Where is the guarantee that all your 1000 people will come here only? Correct, na? Not necessarily they'll come. Why they'll not come? Now, where time, correct, now, what is a Blinkit is there? So many things are there. How many apps you want? Correct, now. They don't need to come to my shop also. Within the society also, they will not walk. They wanted everything at the door. If required, directly in mouth. Correct, no? Right. So, people are like that. Okay. So, I may not get the sales now. That's why what he said, agreement is like last made what? 1 lakh rupees is the fixed amount. Plus whatever I bill in this month. Your society ka manager will be there, na? Let him come. Whatever is the sales, not profit, directly sales into 2% you take. You got my point? You sold water bottle, 20 rupees, that also part of sales, into 2% will be rentals. Have you understood my point? So now every month rent will be changing. Variable. Now which rent I should take for my lease calculation? Only 1 lakh I should consider. Correct. But 1 lakh is not linked. To the extent of 1 lakh, it is fixed element. Correct. But what about the sales into 2%? It is not linked to any rate or index. It will be keep on changing. Is it a pure variable rent or not? I should not consider that rent for my calculation of lease liability. Have you understood what I said? And if you want to calculate also, how do you calculate? What will be next month sale? Next day sale only you can't determine. For next 3 years का agreement enter किया तो what will be sales करके कैसे बोलेगा? That is all too much complication and wrong lot of estimations and wrong. It's not fair presentation. We will not consider like that. Hello, understood? 1 lakh based only my lease liability calculation will take place. Is that clear? It happens like sometimes it will happen with respect to sales, with respect to profits. Yes, it happens to attract the customers. Correct na? Big malls are there, ma. You will have you will keep low, too much of high price. You will keep it. I want to have my shop there. I am okay for it. But if the once I go there, correct na, no sales are happening. Everybody is going to top floor movie only. Nobody is coming to my shop. Then loss only, no. Agree or not? Yes or no? Possible. We also will go directly to escalator. Directly go to movie, see movie and immediately directly come. Maximum there some food will be there, you will have something, come down. Agree or not? Then these guys spend so much of money, so much of rentals, no sales are happening. That time what do they say? They will fix like this. Otherwise your entire this will be khali. Correct? Empty ho jayega. So minimum rent you should pay. Sales you are supposed to. You will trust that every sale will happen routed through the books of account only. So sales into percentage something will take it. That is win-win situation. If you make good sales, I will also enjoy. Correct now. If you are not making, I will support you that time. Means I will collect only sales oriented. I hope you understood. Right. Plus guaranteed lease GRV, guaranteed residual value, if payable in cash. Guaranteed residual value if it is payable in cash, not in kind. Kind में नहीं है. Okay. Plus if there is an option to buy the offer price, right, if it is certain, if it is certain to buy, okay, option to buy, and if it is certain to buy, getting my point? Yeah. What are these things, sir? GRV, guaranteed residual value, means what? I suppose I gave a car to you. I have taken the car on lease. Correct? Right. So car, brand new car, 10 lakh rupees car, you gave it to me. Agreement is for 5 years, I should be using it. After 5 years, I will return the car to you. Correct? Na? The owner is asking, when you return the car to me, na, that car should have at least 2 lakh rupees worth of car should be given to me. If I don't keep this 2 lakh rupees, something number if I don't keep, every person will not be same. Na? Some person will use rough and tough and they bring the car in such a stage that I should sell it on kg basis. It was not car only, it is scrap they will bring. Agree or not? ऐसा भी होता लोग. Correct. Everybody will not be same way. So that will be lost to me. Correct? So that's why I'll say 2 lakh rupees minimum रखना. नहीं तो क्या हो जाएगा? You must have already kept some deposit. ये deposit से काट करके दे देंगे आपको. Are you getting my point? Right. I will collect. Suppose you brought a car with 1 lakh rupees worth. Then what do? I will take car plus 1 lakh rupees also I will collect from you. You getting my point? So minimum 2 lakh rupees has to come to me by end of the 5th year. E-money, suppose if you are expecting to pay in cash, no sir, I am very good and responsible person, I will give 2.5 lakh rupees worth of car to him back. Then you will not pay 1 paisa also. Correct na? And he will also not pay. He will pay. Why will he pay? If you give more means okay fine, that's all, thanks you will tell. Right? So then 0. Otherwise you have to consider. Got it? Next. Option to buy. Suppose the seller has given an option. What is an option, my dear? No, you are expecting today only. You are expecting this. Today you are expecting this. Correct. It may undergo for a change. That lease modification or something revision will happen later. That I will tell later. Okay. First initially we are right now measuring at day 1. Day 1 journal entry ke liye day 1. Right. You should be knowing like your way of usage or something like that. He's keeping 2 lakh rupees minimum. It may be not possible, may not be possible. I'm thinking I will give a good car, I will give a worst car, then I will be end up paying money. If you are whatever you are expecting, you should keep. I'll give good car, so 0 only you keep there. Not a problem. Right. Next thing. You have option to purchase. What do I say? I am a lessee, correct na? First thing. I am a lessee. I have got an offer from the lessor. What is the offer? After 5 years, Ravikant, if you want to buy, na, you pay 2 lakh rupees and buy, no. Buy the car. You only use it, no, brand new car, I gave it to you. 5 years, who used the car? Anyway, you use properly, maintain good, take the car from me 2 lakh rupees. 5 years old car, 2 lakh rupees ko mil raha hai. Assume it is a good offer. Market value of normal car will be 3 lakh rupees, but my owner is offering for me 2 lakh rupees. Is it reasonably certain that it is going to be correct? It's going to be accepted or not? Huh? Sorry? It is low. Your offer is lower than the market value. That means you will accept it. Na? If you buy 5 years old car in the market, 3 lakh rupees you have to pay. But lessor is offering you at what rate? 2 lakh. That means it is reasonably certain that you will be accepting this. When you are accepting that, correct na? That means that payment will be out from you at the end of the 5th year or not? Then you consider that also as an outflow of money at the end of the 5th year. Hello, understood? You have to calculate all these numbers and you have to bring it to which number? Present value ko lena. Present value to, when you say present value means what, my dear? Present value means discounting. Correct na? Discounting. What is the discounting rate you will apply? What is the discounting rate you will apply? Discounting rate will be first priority. First priority IRR of the lessor. Lessor ka IRR kya mil raha hai? Rate of return is always applicable for lessor, my dear, not for the lessee. Correct na? Who will make money? From the lease. Lessor will make the money. Correct na? If you know, will apply. This is first priority. Yeah. From many of the cases, it may not be available. If not available, second. Okay. If not available, which is not available? If not first one is available, then you have to go with. This is what? Incremental borrowing cost. You have to go by incremental borrowing cost. What is incremental borrowing cost? Rate of additional loan, that's all. Incremental borrowing cost means rate of incremental additional. Additional loan le liya to, correct na? What is the rate you are supposed to pay? Bank say additional rate if you have taken, you are supposed to pay some money or not? That number, hope you understood? Yeah. So rate of additional loan you are supposed to do it. Is that clear? Done, no? Right. So normally, anyhow, you don't need to bother about it. They will give the rate, our rate only will apply. Right. But just information ke liye, I just kept it this number. So what do you apply, my dear? Right, same number. Now ROUA, what is ROUA, sir? ROUA is equal to what will come? Nothing but present value of lease liability will come. Agree? Plus any cash given. Present value of lease liability is what, my dear? This is a future payments ka present value. Agree or not? On the date of lease only I paid already 1 lakh rupees to you. That is also my outflow, correct na? So right, any cash given at initially, that number will come. That's all? Not that's all. Plus any brokerage or incidental or transaction cost, I'll speak in simple words. Transaction cost you can call, direct cost people will call direct cost. Some brokerage pay kiya to get this asset on lease. Correct na? Brokerage cost. Yes, that is also part of ROUA. Hello, understood? Plus Provision for restoration, not dismantling, provision for restoration cost. This is not as per the standard, but this is as per Ind AS 37. Okay, you have to bring it and bring it to me in the same original space and etc. Correct? Na? I told you an example. Government lands when they give for 99 years. Correct? Now, what are you supposed to do? You have to restore the place in the original condition को restore करके देना पड़ेगा इसको. Correct ना? Agree? Yeah. Yes. All this will be part and parcel. So, what is my journal entry supposed to be, my dear? ROUA account debit. Correct na? To lease liability. To cash. Correct na? E-cash is for initial payment plus direct cost. Correct na? To provision for restoration. This is going to be my day 1 journal entry. This is going to be day 1 journal entry. Do you agree with me? Like this it will happen. Done? So, now what are we supposed to do? This is day 1 initial. Initial recognition happened like this. Now subsequent, sir, subsequent measurement on the balance sheet date. Subsequent measurement on the balance sheet date, what will happen? First thing, it is ROUA. Balance sheet date mein where do I show my ROUA? Any idea? On the asset side, where do I show? Non-current asset, do I show as part of PPE or do I show separate line item? Sorry? There are both ways are present, two ways of presentation. Two ways of presentation. Okay. One, part of PPE. You see Reliance Company financials here. They will do part of PPE. Anyhow, readily available. Either देखो. Is it property, plant and equipment, intangible assets, everything they clubbed under one? Not a problem. Okay. Observe right of use assets. Has he clubbed? Correct, na? Net block of 31st March. What is the number, my dear? 267,096. Correct, na? Correct, na? If you go to the balance sheet, this is profit and loss. 267,096. So they kept it under only one head. That is, they showed as a only property, plant and equipment includes ROUA. But if you see Infosys by financial statements, it won't be like this. Infosys financial statements, it will not be like this. It will be separately on the face of it only ROUA asset, they will show it. Both are allowed. Okay, both are allowed 100% right. So it is part of PPE. The simple example, Reliance Company करके बोला, right? Now are separately on the face of balance sheet. Many companies does ROUA separately, but both are accepted. Both are accepted. Okay, right? ROUA. This is presentation point of view. What do? We should depreciate. Correct na? Depreciate ROUA. Yes, over what? Over the lease period or over the life of the asset? It depends on what? if you say you have an option to buy and you are decided to purchase, the values you have taken in the above number में option price भी add किया, that means what, it is certain to buy, correct na, then do it over the life, correct na, otherwise normally over the lease period, okay, over the lease period. Over the lease period. Okay. Next question will come. What do you mean by lease period? Correct na. Agreement will be like this. Ma. Suppose 5 years agreement they will tell. Okay, 3 years is what, lock in. Correct na. 2 years are optional. Okay, plus 5 years more extension option is there. Now what is lease period, my dear? Agreement में ऐसा होता. How many years I should? Because depending on this, how many number of years का rent I should take, number will change, no? 5 years agreement entered. इसमें 3 years lock in, 2 years is optional. Correct. Plus they gave an option to renew for another term of 5 years. One more round of 5 years ko we can do it. Now first 5 years nothing like that. E 3 years so mandatorily will come. What about this 5 years? No, today what should I take? Day 1 I am talking. Not on balance sheet date. Day 1 में क्या लेना? Standard obviously says like this way. You take it first 3 years, so there is no question to discussion. Okay. 2 years you take it if it is reasonably certain that you are going to continue. This also you take it if it is reasonably certain that you are going to extend it. Okay, but one point is there, my dear, here. How do I decide that? Correct na? How do I decide? Decision is, they have given a guidance on this also. Some 2 pages document is there, not so straight away they left it. Suppose say example, this Yeshas Academy I am telling. Yeshas Academy, right? Agreement में 5 years दे दिया. Simple example, ma. Right? Entire first floor is done by us. Correct na? I mean so much cabin making, ground and everything is done by us. Correct na? Here also partition is done by us. Painting is done by us. So much of leasehold improvement I have spent. Say example 50 lakh rupees we spent only for this decoration thing. Correct na? This and all who gave? They will not give. A lighting who gave? They didn't give. It's done by us. AC, everything we have set it up on our own. Agree na? So 50 lakh rupees if I had spent on this, on the interior part only, right? And if it is a location is, suppose I spent this much. So if, after 3 years, if I go to another place, there also I have to spend once again, no? If I had spent huge money here, why will I go leave? First, why will I leave? Second, what is the importance of this building to me? Prime location, next to metro, correct na? Accessible to students. So I will not leave. This is very good location for me. Then chances of leaving is less. So continuation will be more certain. And if I leave to another place, I already paid say 10 lakh rupees brokerage here. If I go to another place and again I have to pay brokerage, why will I pay? Correct na? Consider all these things think from the lessee angle. So is it certain that will he continue or is it certain that will he leave? You have to think that way. Suppose if it is a go down, sir. Go down leaving is very easy. Yeah, nothing you did. Go down is one place, I kept the material. Tomorrow I want to leave, I'll leave. I'll bring one lorry, take all these things, and put it in another go down. There, 3 years only I'll take it. Here, I may take 2 years, 5 years or 10 years or 3 years. That depends upon how much you spent on the interior, how important is this building to you, how much is the brokerage, how much, so many other concepts you have to think accordingly, conclude it. Correctness, not so straight and simple conclusion. Application, knowledge about the business and everything is required. Clear? Understood, no? They have documented very well. Fine. Accordingly, you should take it. But exam में इतना depth नहीं आता. Okay, so just forget about it. Right, lease liability. But practically, when you are doing, you are supposed to look at all these things, no ma. Right, when you are wanted to do lease liability ROE, you want to do, first question should come, no. Whether should I do it for 3 years or should I do for 5 years or should I do it for 10 years? అదే బేస్ నో ఆ నెంబర్ చేంజ్ means entire number will change. Correct, all calculations will undergo for a change. There the discussion should happen, there the decision making will happen. Rest all anybody can do it. Once I decide and give it to the article also, the article can do it. What is the major thing? But decision has to happen by us. Correct, your future chartered accountants, you should get into decisions, not into one time you should do calculation to get the grip of it, what is happening. But afterwards, second time, 10th time also I am only doing dabba job. Correct na? Then you cannot enjoy that job. Fine, right. Lease liability को क्या करना sir? Lease liability को क्या करना my dear? Lease liability will be classified into current and non-current. Presentation angle if I see. Correct na? What is the amount you are supposed to pay within 1 year? What is the amount you are supposed to pay after 1 year? That you can determine. Correct na? That is not a big task. Fine. Current non-current classification will take place. Next my dear. Next, what are you supposed to do? Recognize the interest. Interest. So what do you say my dear? Interest expense account debit to lease liability. Done. Next, what do you say? Whatever the payment, lease payments, you are supposed to record it. What do you say? Lease liability account debit to bank or cash. Okay, right. In the cash flow statement my dear, in the cash flow statement, are you aware? Cash flow statement में क्या करना? Lease principal payment should be showed separately, interest payment should be showed separately. क्या बोला? Interest payment, both are financing activity ने. It is a financing activity, no doubt. Interest payment of lease, it is required as per the standard my dear. Okay, principal payment also you have to show separately. You should not club it, right? Yeah, if you see now balance sheet is there, P&L is there, cash flow changes in equity fine. Cash flow statement, see this. Payment of lease liability. Okay, yeah, interest payment correct, but they should have written separately interest arising from the lease liability करके they should have showed separately. Actually speaking, it is a requirement of the standard. These guys have not showed. We can't do anything, right? So that is one. Let's see, is it there somewhere? Nothing. Change in the financing activity. Fine. Not given, but it is a requirement as per the standard. Mandatory requirement. But it's okay. This kind of things are not a serious errors. Presentation, correct? No? Fine. Yeah. So this is the thing, right? Next step. What is the next step, my dear? Any idea? Next step is, one is modification is 1 point. Second one is what? Revision. Kya bola? Revision. I'll directly go to the standard. I'll explain you from there. That is better option because it is well documented here. review or revision, whatever, reassessment. This is correct term. Reassessment of lease liability. Whatever we have discussed so far is a basic. Yearly, first day, you will be recording ROUA, asset account, debit, a journal entry, whatever I told, that's perfectly all right. Subsequently, ROUA will be depreciated over the term, correct? Na? Lease liability interest calculation, interest will be done, and correct, payment will be reduced from the lease liability. That is all normal. There is no change. Reassessment is different, modification is different. This is not a modification of the lease. Terms and conditions of the agreement are not changed. Correct? Na? You write somewhere reassessment of lease. There is no change in the term, no change in terms and conditions. And you should make a note here. It is not a modification. First, it is not a modification of. Modification means what? Terms and conditions are changed where both of us signed. Here, no signing, no change. It is just reassessment. Sometime what happens, I'll tell you. Whenever there is a reassessment takes place, na, point, first and foremost thing, any gain or loss comes, it will go to P&L, that's all. You should remeasure the lease liability, sorry, not P&L, it should be adjusted with the ROUA. Okay, here, right, no gain or loss to P&L. First you write it, no gain or loss will go to P&L. Okay, no gain or loss is going to P&L. Whatever because of reassessment, my liability is increasing. Okay, adjust with the, your liability is increasing, correct? Now your liability is increasing, what will happen to lease liability? Then what should I do? Debit ROUA account, debit. Sir, my lease liability is reducing, so lease liability account debit to ROUA. It will not go to profit and loss. I am crossing it. No gain or loss to profit and loss. No, there is no gain or loss will arise. Modification में gain or loss can come. Reassessment में कुछ नहीं होता. Sir, reassessment means what? First and foremost thing, think na. Points to think. When you are calculating the lease liability, what all you have taken? You read out. First is fixed payment, that will not undergo for a change. Fixed is fixed. Next is what? Variable with respect to inflation rate or any index or something like that. Correct na? So today inflation rate is 4%. Next year inflation may be 5%. So what are we supposed to do? I'll tell you. This calculation I'll tell you. Very, very carefully listen. Listen carefully. Say first year lease is equal to what I told, my dear? 1 lakh. Correct na? What is next year lease, sir? 4% करके assumption ले लो. Are you getting my point? Suppose there is 3 years or 4 years of lease is there, none. Next year lease rental, today only I know 4% is the agreement. Assume, I know it. I mean today I know the inflation is 4%. I should assume that same 4% will continue for next 4 years. Under that circumstance, what do I do? Next year is equal to 104,000. That next year is equal to 104,000 plus 4%. Hello, correct? How much number will come? 8,160. Again 4% plus 4% into 104. 1,12,486. Is the understood? Correct? Na? Today, based on this number, I have calculated lease liability. I multiplied with the present value factor. I have got the liability. Correct? Na? But when you come to next year, what has happened? 4 became 5% now. You should not continue with same 4%. Now reassessment is happening. Is it still 4%? No, it is 5%. Now what should I do? So next year it will not be 104. Current year you got assumed, that's fine. Next year, third year, what do you get? 104,000 plus 5% will come. That next year E number plus 5% will come. Are the numbers are changing or not? Next, is it changing because of your assessment mistake? Is it changing because of your assessment? Nothing. My assessment, I don't know what. Who knows what is that going to be? Is it because of my judgment? Not a because of judgment. Are you getting my point? Under that circumstance, okay, what are you supposed to do? You have to remeasure now using the 5%. New numbers will come. You have to discount the future numbers now. Using which rate? Old rate of borrowing rate. The incremental borrowing rate only is there. Same incremental borrowing rate, whatever you initially calculated, other rate you should apply. Are you getting my point? Right. We can understand that better. Now listen carefully. Change in the term ni, option to purchase ni. E number, fourth bit. Right. Fourth bit I explained first. Change in the future lease payment due to change in the index or rate. Okay. Correct? Right. Including the change in reflecting change in market rental, something is there. Now, in this case, what are you supposed to do? Remeasure the lease liability. What are you supposed to do? Remeasure. Remeasure means what? You are standing at which date? Y2. Y2 means already Y2 related payments already done. Monthly pay kiya na. What is left over? Third year, fourth year left over, correct na. Third year, fourth year number now using 105%, will you get to know how much I am supposed to pay? Assume 5% only will continue for next 2 years also. Now I will recalculate what earlier I calculated based on 104%. Now I will calculate 105. So based on 105, your lease liability third year you will calculate or not? Fourth year also will you calculate? E2 numbers, bring it to present value. Present value whatever is coming, that number will not match with your existing carrying amount. Correct na? The present value must be more than the carrying amount. Yes or no? Now are you supposed to increase the lease liability? Increase it. Difference between these two numbers, to lease liability credit karo. Debit ROUA asset. Is that concept clear? Right. Now for this, when you are discounting, which rate I should apply? Is it incremental borrowing rate of today na, or incremental borrowing rate of original? Original. The simple, this is my explanation. Why means, is there your judgment? Is it something under control? Nothing under your control. So you don't need to take incremental borrowing rate of the reassessment date. Go by the incremental borrowing rate of original rate. That's why we wrote here unchanged discount rate, means original discount rate only you are supposed to apply to determine the present value of new lease liability. Is that clear? Understood, I hope. Right. Now come to the next situation. Over. Next third number, what is I told Amma? Guaranteed residual value. Yes or no? Guaranteed residual value. Right. Initially what you thought? Initially what you thought? I will not pay, I will give a good car. Karke you thought. Correct na? But subsequently after 1 year or 2 years later, what is happened? You already use rough and tough. Now only it will not be 2 lakh. After another 2 more years term is there. So it will become 1 lakh. So then you will end up paying another 1 lakh rupees. Initially what you thought? 0. Now you are thinking 1 lakh. But is it under your control? That is not estimation mistake. That is not a estimation mistake. What is that? Usage, which is going to happen future. Correct na? See, cars, I will take 10 cars. All 10 cars I will not drive no more. I will give it to my drivers. Those guys cannot be controlled by me. Correct na? Company will take the car, and correct. It depends upon the person to utilize. You are looking for a company, not for an individual person. I hope you understood. So company people will not behave like a owner. Correct na? So then my estimations are estimation problem, not estimation mistake. It's because of usage it is happening like that. So earlier I have taken 0 consideration and calculated the lease liability. Now I have to take 1 lakh rupee, take it and take the lease liability recompute karo. since that is also expected to be payable by the guaranteed residual value, unchanged rate only you take it, means you have to bring it to present value using the old discount rate only, right? Next number is what? Lease liability calculation mein what are the assumptions? Option to buy, correct na? Here isn't your judgment to buy or not to buy? Your judgment, correct na? Since it is your judgment mein you are changing your mind. Hello, understood? In these two cases, not change in mind. This is a fact changing. What did I say? Fact changing. This situation is my mind is changing. Initially, I thought I will not buy. Now I thought I will buy. Here, what is it telling? You have to now. If you say initially I said I will not buy. Now I am thinking I will buy. Means liability goes up now. If you buy means you are supposed to pay money at the end of the 5th year or 4th year. That number also you add it to the lease liability by discounting it, correct na? Discounting mein which rate discounting now I should take? New incremental borrowing cost, revised discounting rate you are supposed to apply. Where? Right. If the option to buy the asset, earlier you considered, now earlier you kept 0, now you want to keep it. Or earlier you kept 1 lakh or 2 lakh rupees, now you want to make it 0. Yeah, you can make it. Your vision will. I hope you understood. Then next one more thing is what? Lease term. Change in the term. Initially I thought, what I thought? Let me 3 years only I will take a lease term करके सोचा. Correct ना? Subsequently you decided what? No, let me continue it for another 2 years, or let me continue for 10 years करके you changed the term. It's your judgment. Hello, understood? Then also, correct, earlier you have calculated for 3 years is the lock-in period, so only 3-year lock-in period को calculation कर दिया. Correct now? 1, 2, 3, and you brought it to present value factor apply कर दिया. This is present value of lease payments को you calculated and passed the journal entry. Now at the end of the second year you decided, no, let me use it for another 3 years or another 5 years or 10 years ऐसा करके your lease term is changing. That time also here, see, because of the lease term change, because of the guaranteed residual value change, because of the option to purchase decision change, because of the index rates and etc. change, there is no change in the agreement. Is there change in agreement? No. Is all these conditions and sentences were already there in the agreement? Yes. Are we going for a change, a new paper printout and signing? Why new paper? Same paper. Judgments are changing. What is changing? Exactly. Judgments only are changing. Fine. If judgment changing, correct, not fact, not because of the fact, then new incremental revised rate you should take it. No, facts are changing, old rate you should take it, correct na? And determine the new lease liability, compare it with the carrying amount, correct na? And up or down, adjust it with ROUA. No gain, no loss, nothing to P&L. Prospectively ROUA will be depreciated. Is the concept clear? That is what is the concept of this. Okay. Next concept is what? Separable contract. Yeah, this is also a good, good concept, right? Separate contract. What is the separate contract in area? Separate contract means it will be like this, ma. Listen. Sometimes it looks like a modification. In one of the client in same exactly situation has happened. They have taken one floor in one big apartment is big building, office. Okay, my client has taken the entire floor, he has taken. Now his business is growing, so number of employees also will grow, correct na? He has taken one more space is available in the same building. Obviously we'll say we'll take that next floor also, we want it, correct na? What these guys have done, existing agreement paper को लेके earlier say example 50,000 SFT करके लिखा ना, they have not entered into the one more agreement paper or only one small addendum कर दिया. Addendum क्या कर दिया? Old agreement ka 50,000 SFT will become now 1 lakh SFT. What is the amount? Amount will change. Na? Amount, new numbers, we have kept it. Now, is it a modification? Have you understood the question? What is the question? Tell me. Additional space you have taken here. Simple exam. Correct. Na? Additional space, additional rent you are supposed to pay. Correct. Huh? Is it a modification to the agreement? It is. But it will not be dealt like a modification as per the standard. Why? Question number 1. Are you taking a new space? New asset is coming in? Done. Now, what is the rate? Next question should come to rate. What is the rate? Normal market rate only he gave. What did I say? Market rate only he gave. When it is a market rate, it is SSP, standalone selling price. Are you getting my point? If they had given it to another party, other rate only they would have given. But they gave it to me. I mean to say, because I already occupied 50,000 SFT, they have not given me discount. अरे समझ में आ रहा है? Then it is considered as a new contract. How should I treat it? Correct, na? You wanted to save the legal fees. That's why you went to buy addendum to the original agreement करके one small 100 rupees document 100 rupees का stamp fees लेके लिख दिया उधर. Correct ना? But if you make one more agreement now, what will happen? Another 50,000 may cost you. Understood my point? That's why they made an amendment. But this does not amount to modification of the terms. It is a separate contract. When it will become separate contract? 2 conditions. What is the 2 conditions? New asset has come, new space has come, whatever it is. Plus, rate should be independent. Depending upon that date market, they have charged me. Not a discount given because I was already an existing customer. Then it should be treated as a separate contract. Correct na? नया कॉन्ट्रैक्ट आ गया ये 50,000 का ओल्ड कॉन्ट्रैक्ट का कैलकुलेशंस को डू नॉट डिस्टर्ब इट. नाउ additionally you are supposed to pay for the other 50,000 का वाला ना, इसको separately ROU account debit to lease liability डालो, इसका period ले लो, everything separately calculate करो. That's all is what separate contract. Are you clear on this? Right. Now come to the next question. I mean part of the question is what? If it is a separate contract का छोड़ो. Yes, modification. क्या बोला मैं? Lease modification. Yeah, here terms and conditions are changing. What is terms and conditions changing? Listen. Earlier I have taken 50,000 SFT. Now I am saying a 50,000 beta, make it 25,000. Understood? Right. Now what should I do? Existing contract को modify करना. Correct ना? Old numbers को change करना. Agree? Done. Or rent amount change हो गया. We went and bargained. Right. Earlier original agreement is mentioned something. Now we came to understanding. No, I will not be able to pay. Or whatever mutually understood number is changing. Possible, not possible? Next, what else can happen? Space is increasing, but rate is not charged as per the market terms. Rate is charged lower rate because I am already existing customer. Hello, understood? Then I cannot consider it as a separate contract. Are you getting my point? Listen, first and foremost thing you should remember now, my dear, if it is a modification, you are to calculate the lease liability. Recalculate lease liability. This using the new rate, new discounting rate, not old discounting rate, all the time. New modification, any modification ko, got my point? You should consider as a new discounting rate only you are supposed to consider, not a old discounting rate is not applicable first. Next, In lease modification, my dear, not in every situation, there can be a gain or loss. That should be transferred to profit and loss statement. Yes, there can be a gain or loss that should be transferred to. Yeah, so as I said, there can be a gain or loss that should be transferred to profit and loss statement. Okay, how does it come? Okay, it will not come in every circumstance, it will not come, but that's what I told. No? One has to apply their knowledge there. Every circumstance it is not, it depends situation to situation, it will vary light, but you have to be alert. See here, whatever the concepts I gave, condition for treating as a separate lease agreement, I already explained. There is an increase in the scope and the standalone selling price only they have given, then it is a separate lease agreement. If the lease modification is not accounted as a separate lease agreement, yes, it is not accounted, means other than separate lease, all the changes, correct, na, term change. Earlier I said 10 years I will use it. Now you are increasing it to 12 years or it is decreasing to 8 years. Possible, na? That is also change in the terms only, na? Automatically rental amount change ho gaya, space change ho gaya, term change ho gaya, anything change is a change. Correct? Then it is different. So now the point, yeah, lessee should account for the remeasurement of the lease liability. Okay, right. How do we do? Observe carefully. Point number 1. First, for the lease modification, where there is a decrease in the scope of the lease. Decrease in the scope means what? Earlier 50,000, now it is 25,000. Are you getting my point? Decrease. Earlier it was for 10 years, now it is for 5 years. Are you understanding my point? Term change, scope change, all change. Okay, na? Reduction, decrease, concept which you need to look at. Decrease ho raha hai. Okay, then what are you supposed to do? First, what are you supposed to do, ma? You will calculate the lease liability, you will remeasure the lease liability. Correct? What we should do it, once some may it will come, but if it was, you should calculate like this. Okay, right. Maybe I don't know whether I will be able to express correctly, but you try. I'll also try, you also try to catch. Earlier 10 years term. Now this is 5 years term. Correct, na? You already would have got some carrying amount. Okay, next. The change happened when? In the mid of the period. Correct, na? Maybe after 2 years, we realized I don't want for 10 years, my dear, I will take it for 5 years. Means another 3 years only. Correct? Now, one number you should calculate. What is my present value of lease liability for the remaining 3 years of period? Are you with me? One number will come. Keep it. Now, if it was from the beginning, if it was only 5 years lease, correct na? If it was 5 years lease, actually my calculation is what? Different, 10 years lease. What would have been my number for the 3 years? These two numbers will not match. Pakka it will not match. Correct na? Our difference should go to profit and loss statement. First level. Okay. That is what he is trying to tell. Okay. Next number adjusted with the ROUA. That's a different concept. Okay. So credit, if it is, yeah, obviously credit will happen to ROUA because initially you calculated for 10%. 10 years ka calculate kar diya. But when you are doing the reversal calculation, it is for 5 years only, na? Decrease. ROU initially for 10 years. Now it will be coming for 5 years. So it will come down, na? It will come down only, no? That's why we said credit ROUA. Reduce ROUA. Correct, na? To reflect the partial or full termination of lease. Whatever the reason, we are going to take it. Next, any gain or loss on this partial or termination, that should be recognized in the P&L. Right? If it is decrease in the scope, E kind. Decrease may profit and loss will come. Remember this point. If there is an increase in the scope, correct na, gain or loss will not come. The corresponding adjustment should be given to ROUA. Increase in liability, to lease liability, ROUA debit. What did I say? See, end of the day, logic is simple. First, there is a modification. First, okay na? Yeah. Is it a separate contract? Otherwise, I'll write like this. What do I write? Is it increase in the scope? Increase in, not scope, increase in asset. Addition plus rate is at SSP. Answer can be yes, answer can be no. If you say yes, then it will be treated as a separate lease. Account as a new lease agreement. Straight and simple. Correct. Next, if you say no, no means what? No means two things, Amma. Correct na? What can happen? Decrease in asset or decrease in term. Correct na? Decrease in term, it can happen. Agree? Not decrease in rate. Here decrease in rate, amount, or increase in asset but not SSP. First you try to digest this. Correct na? Then the whatever I am trying to tell, you will catch it. Otherwise you will not be able to catch it. Here tell me, initial agreement I will write like this here. Initial is equal to say 10,000 SFT. Term is equal to 10 years. Correct? Now additional new what all can happen, my dear? Decrease in asset. What are you making? I will make 5,000 SFT ko I am making it. Correct? 5,000 SFT you are making, you will not come to E side obviously. You will come only this side. Next, decrease in term. I am making only 5 years. Then next, decrease in amount. Earlier old amount is equal to say 50,000, okay, 5,000 rupees per SFT I spoke. Now it is 4,000 rupees per SFT I speak. Decrease in amount is not decrease in scope. Hello, correct? क्या बोला? Amount is same. I mean, amount only changing. Space is same. Space कितना? 10,000 SFT. Correct ना? Term कितना? 10 years. No change in those. Only amount में change. अरे समझ में आ रहा है? हाँ. Then it is not a scope change. It is same thing. Next. Next is what? Increase in the space. We'll make it like 15,000 SFT. But rate is equal to not SSP. Rate is different. Market rate में नहीं हो रहा है. It is happening at a discounted rate. It is happening. Hello, understood? Then it is not a separate contract. Na? SSP hai to. So all are possible situations. Have you understood now? Here gain or loss can come. Okay, right. Here what will happen? In the second circumstance, whatever lease liability account debit LL to ROUA or ROUA account debit to lease liability. That's all you are supposed to do. Okay, right. My suggestion, we can't solve the sums, too many sums, not possible actually. Time doesn't permit. Fine. So what you do, you on this modification, you can refer whichever the material you are following. There will be one or two sums minimum. There will be, correct na? ये sums एक बार कर दिया तो ना. Yeah, keep this in front and you do the calculation. It will work out. Fine. This is a small diagram, small chart, just like that we made it. Understood? Right. Term change also can be considered as a scope change. Yes, scope change, but amount change is not a scope change. Assets are same. Are you getting my point? Earlier, 10 cars I gave it. Correct. Now you wanted 2 more cars. That is increasing. But rate is not market rate. Market rate hai to it will be separate asset. 2 cars are, what did they say? Market में 1 lakh rupees per annum rent. Now only 50,000 को I got it. Why? Because I already taken 10 cars. That's why थोड़ा discount में मिल गया. Not SSP rate. Correct ना? Now 2 new cars को थोड़ा extra lease liability be to be added or not? Then it will be lease liability account credit, ROUA will be debited. Understood? Here gain or loss कैसा आ सकता? New payment, new ROUA will come. It cannot be something. Understood? Amount change. Yeah, my payable has come down. What I was supposed to pay 1 lakh rupees per annum rent. Now I am paying only 70,000 rupees per month. Correct na? Are you getting my point? Whatever. Amount reduced or amount reduced. Amount increased. Both are not scope change. So to that extent, ROUA will go up or down. Plus, increase or decrease based on that it will happen. Hope you understood that. Okay. Change in amount, not change in term. Clear? Right. So this is related to modification. Right. After modification, there is nothing, my dear, here. After modification sums, if you see, these are all what? Exemption wala. Okay. Directly will come to presentation. That means lessee's angle is already completed. Right. With respect to lessor, what I was telling you, right? It will be classified as operating lease or finance lease. Okay. Right. So that concept will not teach, but we will teach you this concept of sale and leaseback transaction, which I will explain you. We have some 20 minutes of time. That is enough to understand. Okay, right. I'll try to give you the concept, catch the concept correctly. That will give you fair idea. Question. Sale and leaseback. In this case, no, one student, he brought, whatever he solved is exactly as per the book, as per the suggested answer also. The fate kya hai? He didn't get the mark. His answer also matching exactly. It's not that he changed the method. No, he didn't change the method. He exactly followed. Few cases are like this. I don't know why such kind of thing will happen. We don't know. What is there suggested answer given to the exam? The worst problem with your FR, no, frankly, I'll tell you. Who corrects the paper? Who are more than 5 years of experience. Correct, na? Next. Most of them, I should say, thoda aged guys. Means aged in this is not like 70, 80 years old also, I'm not telling. 50, 60, 50 at least you can take it. Very less number of people only. Correct, na? If your age is less than 50, no, you are obviously busy only. Being a chartered accountant, you must have 50 years age means you must have reached to CFO level or next to CFO level. You will not have that much time to breathe. Agree ना? ऐसा I'm practicing. I'm बेकार करके कौन बोल सकता? Very less number of people will be there. Agree? Right. And all these guys must have never studied Ind AS. What are all the possibilities or alternatives available with respect to Ind AS also they don't know. They just follow what? Suggested answer एक पेपर दे दिया exactly है क्या दे दो नहीं तो no. To take their own call also because their study effort will be less no. You cannot see. Me studying means I have to teach class, I have to work on this subject. So I will be teaching deeper and deeper. Only for correction purpose, who will read that much deeper and deeper? ऐसे क्या दे दिया ये perfect है. Correct. If some student has given alternative answer which is not mentioned in the solution also, na, suggested answer also, still you will not be getting the mark. The practical issue is this, fact is this, but ICA will never accept this, as you know. Got my point? This is the worst problem. Ind AS is the issue. Okay, fine. Huh. That's why, I mean, one way okay for student angle, one way bad from, okay. My personal opinion. Sometimes I cannot blame student also. Okay. Why I'll tell. Paper setter, last 2 attempts or 3 attempts, exactly copy paste of ICA sums de diya to namma. If Ravikant comes and says, I'll teach concept, practically required. What you will do? I don't want. I want exam, I want to clear. Correct na? You will not care. And if I explain another probability, second, third probability, fourth probability, practically we are doing like this here karke, if I explain na, that also you will say veda, waste, time waste. We don't have that much time. Agree? Correct. You will pass that, we will see later karke. Everybody's mentalities will be like that. I'm not commenting on that. Suppose if ICI only ask every time different question. Concept, every concept randomly they should be testing. Don't give copy paste some. Correct na? What is happening? Copy paste दे दो chat GPT को आधे क्वेश्चन से नंबर चेंज करके कैलकुलेट करके दे देगा. I don't need to apply my brain only. You understand? Everywhere नंबर को डबल करो और हाफ करो ऐसा वन करेक्ट इंस्ट्रक्शन दे दिया तो ना chat GPT can give you easily. Got it? I want answer in this particular style करके proof the one proforma दे दो. Perfectly it doesn't give it to you. You recheck once again. तो ಸ್ವಲ್ಪ change may be there. You change it and give it to students means that will not work out. If you ICA keep the way correct now, what you are expecting from student knowledge, ask in that style. First time, student will understand. No, they are asking differently. Correct now, conceptual questions are coming. Then we have to build our concept. Second time also like this. Third time also like this. Then automatically mindset of the students only will start changing. Correct now. If you give 4 attempts continuously, adhe question, adhe number, adhe answer. That means you are driving that thing is in that wrong fashion, no? That's why I do blame first ICA, not the student. If really expect them to study, correct na? Instead of making a consolidation करके 16 marks हम क्यों यार? Seriously, what is that? Correct na? Everybody will do. Adjustment दे दो ना exactly. Correct ना? Contingent consideration. कैसा अकाउंट करेगा बोल. This is the terminology. Sufficient. Correct na? Contingent liability. 2 marks question. Don't make them to work on 16 marks consolidation balance sheet should tally. Why should it tally? It will tally automatically. Problem क्या है? Contingent consideration. दे दो ना. पूछो only that contingent consideration you पूछो. For 2 marks or 3 marks. I don't want to ask you 20 marks of consolidation. Agree? Like that you ask. Then what will happen? What will you do people now later onwards?
Consolidation, why should I solve? Yaar, computer mein already is there, no? Tally me number, tally me everything will tally. Correct journal entry, if somebody knows, he can pass the journal entry in the correct period, automatically it will tally. What is the nonsense I should do that for that? Agree? Like that you ask, no? Why you need to give 8 marks, 10 marks, 20 marks, Kasam? Make it conceptualize. The paper setting only should be changed in such a fashion where I will be testing concepts. My student who pass out should know all the concepts. Then automatically student will be studying the concepts. And when he goes tomorrow to any big company interview, correct na? I'm telling you, go to ITC, they will offer you 24 lakh, not less than that. Sit for interview, na? You will start sweating in the AC room. The level of questions will be not exam questions will not come. Practical questions will come. Correct na? Then you are not fit for sitting in the interview hall only. You might be all India first ranker. Understood? That means you are making your product useless, no? By setting up such kind of nonsense papers. That is the problem happening. You drive from the top person correctly drives what you want. You guide down. Correct? Na? Nobody bothered. Everybody like 20 marks de do, 30 marks de do, ye kya de do? How your people will be correct na, competing with international students? Cannot. They know how to prepare balance sheet and P&L, but they don't know adjustments, all probabilities. Kaha? Because you are limiting yourself to one text. Correct na? Our text is not up to the mark. Practically you see na, how many, correct na? Practically you take your book, textbook ले लो, one company NBFC company का साथ बैठो, what all happening? इसमें 20% also is not there in your book. Go to some manufacturing company, leasing company, or any company ko sit with them, no? Then have you covering all this? Dabba sums, one example you will give, adhe sum you will repeat. I'm telling that's why now you completed FR, completed. I got 65 marks. Yes, super exemption, you got it. Can you do one lease liability calculation for me? Sorry, I don't know. Then what is that you are achieving? You understood? Our paper settings level, our top level of board of studies, people only should sit like that. If their thinking style changes, then our fate will change. Till that time, left to them. Very bad, but somebody has to comment. No? It's the worst problem. Chalo, right. Sale and lease back. Yeah, one beautiful concept. International standards. No, seriously. Today ACCA exam FR paper. Okay. Kids have messaged. They did excellent. ACCA का 3 times exam है करके we are also keeping 3 times. Ada you followed. ACCA paper कैसा है देखो ना, 60 marks MCQ मा, 60 marks MCQ. Got it? 40 marks only your descriptive. There also na, one consolidation question दे दिया तो at skill level I am telling, not at the professional level. Skill level paper also, I mean, the way they're twisting the sentences now, awesome. I enjoyed even. There's a basic level only. But it is very good way of questions. It should be like that. Skill level people asking at that level means was very good. I mean, I felt professional level you should see. You people will not pass that. Too good. The level of questions, na, you make them think. Give them opportunity. Correct na? That's all. Space de do na isko. I want like this. I'll ask like this. The concept of 20 marks should be deleted in my opinion. Correct. More conceptual you ask. Yeah, one question they will give, case study basis. इसमें minimum 4-5 standards will be covered. And again, our questioning also is not like e paragraph separate. I'll see some of the ICA questions. Case study. First para is related, second para. Para, e para linking will not be there. Correct na? Then what is that you asked? Framing a wrong. You should give like this na. First year, adhe company situation change ho gaya, second year. Correct na? Third year, now you ask question. Oh, then student will also think, oh, like first year में like this we have accounted, my present balance sheet में numbers ऐसा आ रहा है, ये item को second year impact ऐसा हो रहा है, then what will happen? Correct now, view will come no for him. Obviously debit credit you guys already know it. A view, where is it? It's missing. Correct na? We are I mean top level people are talking very high level talks. Very high level talks. You are releasing outcome is not that great. Outcome seriously not that great. It will not be there. You cannot expect from every office will not do all kinds of job. Correct na? Every CA chartered account office, correct na? You join one small firm, or you join firm where they are focusing more on tax. Correct. Only tax will come, but at the same time, just because you did articles, your articleship firm only tax is there. You cannot say that I don't want to learn accountancy. No. Correct na? That is where actually they kept 3 years. That 3 years was fine. Now they changed it. It's okay. Leave it. Every day you should be studying. I know they will make you work like a donkey till 10 o'clock. This some practical issues are there, but just because practical issues are there, if I release my product, correct now, once you come out, you are my CA product. Okay, suppose example, Anna, you don't have any basics, somehow you passed. You will come for interview to a big company. If they say, how did you pass करके one question आ गया तो, what is the loss? Loss of ICI brand, no? Your personal loss is personal loss separate. ICI brand loss, no? Right? So we have to study it, no? 3 years may. For us, articleship was 3 years. We used to study on a daily basis. Correct. Now, when the sum is going to be difficult, conceptually it is going to be asked, automatically you will open book from the day one. Agree or not? If it is easy, ये book में क्या है, यही पढ़ो यार, यही आ जाएगा, then why should I open? I will open last 6 months, I will study. Next, and again, tell me student also, will you have any budget? Which study का, which subject का कितना time लगेगा? How much time is required for study, focus? So I should open from the day one karke, where is your plan? Correct na? First 1.5 year you will watch only reels. Time is gone. Now last 6 months may everything you want. Not possible. Don't expect practical experience will come for everybody. Even I told when I was telling starting of the class, I told na 80 to 90% I must have applied, not 100%. 80% is a big number. But still I will not say 100% I know, 100% I am master in Ind AS. I cannot say like that. If somebody is telling I am master, I am tata karke something is they tell no. It is a biscuit. Okay. That is a ocean. Who take a dive, no, there. They will tell, no, I am not master. I know subject. That much. Because it's ocean, my dear. When you start doing, na, every time we'll get a question means, all again you have to think, rethink, recorrect ourselves. Correction, recorrection, so many things will happen. Nobody will be perfect. But my point is you should get a space, time, set the pattern like that so that my students will start thinking. They will also move towards that. So that even though they struggle for first 2 years, articleship and time may, subsequently when they come out, now they should feel comfortable. When they face a client, correct na, I want my student should not get like, I don't know this, I never heard this, exam के लिए किया, Bhul gaya. Will any client come to you? Then do you people like tell me frankly, can you open one practice? Impossible. You are paid labors. Going to be. Agree or not? If you get a grip on the subject, then you will start. At least you can think of. Otherwise, where do you get guts to start? It's not possible, my dear. That is not good for ICA now for a period. Chalo, let's go to this. That is more important. Sale and lease back. Observe carefully. Beautiful concept. No doubt about it. I say stop writing and listen. If you want, you can take a picture later. Okay, it's the last concept I am explaining. Okay, for that I'll finish this and then I'll stop. Fine. Yeah, we have gone outside the subject, but doesn't matter. Some 15 minutes may explain karenge. See, there is a party A. There is a party B. Okay, and this guy has got, say, I will say some building only. I will tell building. I have building. Okay, right. What is the remaining life of building? This is not a new building. Remaining life of building. Assume my dear 20 years of life. Kitna life? Baki left is 20 years. Maybe already 10 years or 20 years I already used it. Fine. As of today, 20 years is the life of the asset. Okay, right. Now, what will happen here? Okay, right. This in my books, that is in my balance sheet. Obviously, building is an item. Correct, na? E building mein, how much is the number? This is called book value, carrying amount. So, some 100 rupees, 1000 rupees, something number is there. Okay, the cost, that is WDV, is 100 rupees, 100 crores, lakh, something number, I kept it. Done? Right. Now, what is happening? Right. First, we will enter into an agreement. What is agreement? Agreement number 1, that is sale agreement. What is this? Sale agreement. Okay. Sale agreement mein what will happen? A will become the seller, B will become the buyer. Correct, na? B will become the buyer. You sold for, what is your selling price? Selling price is equal to 120 rupees. Correct, na? Right. Normally, what A does? Sale agreement enter kiya na. So, I will say cash account debit, 120 rupees paisa vasool. Okay, to building. Correct, na? 100 rupees to profit and loss. That is equal to 20. Has he recognized 20 rupees profit? Over. Now, same day, they will enter into one more agreement. Okay, that is agreement number 2. That is a lease agreement. What is this? Lease, just lease agreement. Okay. Now, because of these lease agreement, what will happen? B will become lessor. This guy will become lessee. Agree or not? That's why the terminology of the standard also, seller lessee, buyer lessor, करके language they use it. Buyer lessor means buyer from one agreement angle, lessor from another agreement angle. But language is always like buyer hyphen lessor, seller hyphen lessee करके ऐसा लिखेगा. Not a problem for me. Now listen. Lease, what is the term, sir? Term will be there na, for lease. Say example, 12 years is the term. Kitna, sir? 12 years is the term. After 12 years, what will happen? Yeah, asset building should be given back to B. Hello, agree, yeah? Yes or no? Right. Or it can be for even full 20 years also, it can be there. It can be for lesser, it can be for this. Right. Now the concept is, listen. A sold the asset and A got it back. Correct, na? Right. One, I mean, it may be difficult when I take the sum, then you will catch it properly. Okay. But you have to apply your knowledge. You have to be very alert. Otherwise, it is not a easy concept. This you have to agree. To understand, attention is more important. More and more important. Actually,
A sold what? Building. With what life? Wrong. With 8 years life. Correct na? You are only using for 12 years na. Actually you sold 8 years life building only you sold. Agree na? But have you booked the 20 rupees of profit for the full asset value? Yes or no? Right. Listen now. As part of the agreement, if I consider each agreement, what A would have recorded? ROUA account debit to lease liability. Just 12 years wala, whatever the present value of number, correct na, that he would have taken. Do you agree with me? First thing is, what is the standard is telling, right? First, is it a sale agreement? When you say sale, the first point is, does it satisfy 115 under as per 115 rules? Correct na? Is it really transfer of control has happened or not? Transfer of control has happened. Answer can be yes, answer can be no. Correct na? If you say no, transfer of control not happened, that means sale is not happened. Without sale satisfaction, but B has paid money to A. Hello, correct na? If correct na, I am writing here. Hold on. If 115 not satisfied, that means control is not transferred to other party. It is not a sale as per 115. Then correct na, still B gave money or not? B gave money to whom? To A. That will be, A will be recording it as a loan. Record as a loan. Loan is a financial liability, then go to 109. That's all. B will be accounting, B gave money na? Yes, loan given. Loans and advance. Again, for this also, financial asset 109 you are supposed to follow. Hello, understood? What did I say? First question is what? Is it a sale as per Ind AS 115? Now I am discussing the option number no. If it is a not a sale, then what it is? Treat it as a loan given. Hello, correct? Treat it as a loan given. Correct. Now, whatever the installments he will pay, A will be paying the money or not? With whatever the name you call, is lease installment or nonsense system, whichever name you want to keep, that is nothing but loan repayment with interest. Hello, correct? That is one. Now, listen carefully. Once again, I'll explain. Okay, accounting in the right. If you say it is not a, if it is not a sale, look at the sentences, my dear. Is the transfer asset a sale as per Ind AS 115? First question mark. Correct? Yes or no? No answer has come. Then what do you say? You continue to recognize asset. Asset ko don't change it. Because asset sold, but it is not a sale. That means building will be continuing in the balance sheet of A. And recognize the financial liability. Whatever the money you have got, that will become a loan taken. That only I told. 109, the amount received will be considered as a loan. From the books of the buyer lessor, that is B. Correct. Now, buyer lessor, yes, don't recognize asset because it is not, when it is not a sale for him, it is not a purchase for you also. Na? So, you also should not recognize the asset. But whatever the asset, whatever the money you gave, that should be accounted as per 109 as a loans and advance. Is this part is clear? Right. Now, come to this part. E part mein, what does it says? De-recognize the underlying asset. Because asset control is transferred. Correct. Na? So, what do I say? Right. Listen carefully. Instead of these, numbers will change. What do I record, my dear? To building, I will record. Okay. To what extent I will record, I will tell later. Next, are you going to get a ROUA or not? Yes, you are going to get. Correct. At the same time, do you get a lease liability? Because you are supposed to pay the money. Na? And have you received cash also? Correct. Cash received. Na? Because you sold means you must have got some money. 120 rupees to aa gaya, na? Hello, correct or not? Then there will be some balance. There will be some balance. It may be here or there. Correct. Now that is a balancing figure. This or this, right? That will be transferred to profit and loss. Fine. But here, one need to be careful. Where you should be careful? Lease liability will determine. This is same as usual. What did I say? Same number. No change. correct? Sir, building, this is a book value, whatever is there in the books, that I am supposed to credit it. There also no change. What is the cash? Cash is nothing but actual. There also no change. E correct na? ROUA only will be different number. Okay, ROUA will be not normal ROUA, it will be recognized as, okay, book value of the building. Kya bola ma? Book value of the building, right? And correct terminology, I'll use it here. Look at here. ROUA is the proportion of previous carrying amount, that is what? Book value of the building, carrying amount of the building, right of use asset retained by the lessee. Right of use asset retained by the lessee. How much you have retained? A has taken it for another 12 years or not? Correct na? 12 years you have kept the right. 12 years ka life kitna? Indirectly I will say, agree, 12 divided by, you calculate, 12 divided by 20 is into 100 kitna ma? 12 years out of 20 years, 60. That means in simple words I would like to say, building book value is equal to, building book value is equal to 100, 100 into 60%, that is equal to 60 rupees will come. This 60% how did I calculate? 12 years is the lease period out of the remaining life of building life, remaining life of 20, correct na? 12 by 20 into 100 if you apply, what will come? 60%. Only to the extent of 60% you are supposed to record it. Balancing figure will go to P&L. Can we apply this in the sum? Have you understood? What is different is only ROUA. Rest all same, no change, correct na? Right. Why ROUA? ROUA is not normal. ROUA is nothing but what I am using, correct na? Building value is equal to 10 lakh, 100 rupees is there, 100 into 60% is coming back na. So what exactly you sold is only 40%, that 8 years is what the sale, correct na? See, observe carefully my dear, here book value 100 I wrote, what I wrote here? 100, and I am writing 60 rupees on the debit side. That means actually gone out is equal to how much? 40 from my books. Name is changing, building is becoming ROUA, but I am recording 40 net impact. Understood? Right. I will show you with the sum. Fine? Yeah. The rest numbers are same. Nana. Recognize the liability same. Gain or loss will be the balancing number. These are all fine. Only change is ROUA wala. Retained. The 60% is retained because 12 years I am taking it back out of 20 years. What is retained? Only my asset. Na? What is retained is my asset. What is given is 40%. So that's why 40% I am removing out of 100. 100 is becoming to 60. 40% gone is what is left. You are right. Shall we go ahead? Right? Right. I will go to the sum. Observe, carefully observe. This is one beautiful sum. Same question with number change he asked in the past. Nothing. This question I have not given the year, but the same sum it was asked in the past. Okay. A percentage in simple words I told you. Correct na? Exam mein two different numbers ka one by one you have to apply. I will tell you. Next, one more thing. One more concept is here. Listen carefully. See, Nana, fair market value of the building. In my example, say example fair value is equal to 120 rupees. What is the building fair value? 120. But your selling price is equal to 150. Frankly speaking, which fool will purchase? Agree, na? But here we are buying. Why we are buying? We are taking the lease is one point. Another, anyhow, lease payments will come, no? Higher rate will come. Same guy will take it on lease. Hello, understood? From whom I bought, I paid him more money. He only is taking the lease. A is only taking the lease. Correct. When he is taking the lease,
he has to pay me the lease payments or not? That time when he is paying lease payments, he will not give the market rentals, no. I gave him 30 rupees extra. Understood? Accordingly, he also has to give me more than the market terms only has to pay me. Correct? Now that's why no problem for me. I am buying it. Hello, understood? But what the standard says, sir, market rate is how much? 120. But you sold for how much? 150. E 30 rupees, A should consider as loan taken. What should I consider? Separately, loan taken karke le lo. Hello, understood? If he is selling at 120 and 120, now we will not disturb. No touching. Everything is perfect. Is it clear? Can we go ahead? Now read the sum. Entity, seller lessee, that means A party, sells the building to another entity, buyer lessee, that is to B, for cash of 20 lakh. Selling price. Immediately before the transaction, building is carried at a cost of carried value. Carrying amount is 10 lakh. Carrying amount is different, fair value is different. What I spoke here, this is a fair value. Correct? Na? At the same time, correct, but here you see the sentence. Fair value of the building is how much? But you sold for 20 lakh. That means 2 lakh rupees is loan. Exactly. 20 lakh rupees is loan, not anything else. I hope you understood. Perfect. Now pado. Dekho carefully. At the same time, correct na? At the same time, seller lessee enters into a contract with the buyer for a right to use of the building for 18 years ko he is taking back. E example mein he will not give what is the remaining life of the building. But we can calculate remaining life of building in indirectly. We can calculate. We'll calculate and I'll prove that percentage is same. Matches pin to pin. It has to match. Okay. Right. Listen. With annual payments of 1,20,000 payable at the end of the each year. So 1,20,000 rupees is what, my dear? Lease payment. But actually lease payment includes not lease payment. 2 lakh rupees excess loan liya na. Iska bhi paisa pay karna na. Hello, understood? Is it market rentals? It will be obviously higher than market rentals. Why? Because I purchased the building not for market rate of 18 lakh, I purchased for 20 lakh. That means 2 lakh, correct? Na? So, 120 lakh rupees is actually divided between two lease payments, and we'll talk about that little later. But understood no concept. Next, the terms and conditions of the transaction satisfy the performance obligation 115. That means it is a sale. Then only our accounting will happen. Otherwise, this sum will not be applicable. Correct? Na? Interest implicit rate is 4.5% per annum. Assume buyer lessor classifies the lease building. Read this carefully, ma. Buyer lessor means B. B is classifying it as what? Buyer B is a lessor. Is classifying it as operating lease. That means what? It is a short period. It is not for the full economic life, remaining period. That means what? Life of the asset is not 18 years. It is much more than 18 years. Correct? Then only it will be operating lease. Are you getting my point? If it is for equal period, 18 years is the remaining life, this is also equal remaining life, then buyer should have accounted as a finance lease, not an operating lease. Correct? Indirectly he told, life is jada. Remaining life is not 18 years, remaining life may be some 25, 26 years, something. Just an example I am telling. Clear? Fine. Now come to the matter. Tell me, ma, in this case, what is the entry you will record? First, have you received cash? Yes, we are looking at from the LSC point of view, I am seeing. Have you received 20 lakh rupees or not? Correct. But hold on. I will say, to financial liability, can I write 2 lakh rupees? 2 lakh rupees loan. 2 lakh rupees is a loan. Why? Because I sold it for a higher price of 2 lakh rupees. Hello, correct? It is not a lease liability. It is a loan amount. Next, can I write 2 building account debit, credit? That is equal to 18 lakh rupees. Not 18 lakh, 10 lakh rupees. Carrying value is 10 lakh, na? Agree? Right. Next to what? 2 lease liability.
I am supposed to calculate the lease liability, right? Lease liability calculation के लिए listen, ये loan amount here ये 1,20,000 rupees includes the repayment of 2 lakh rupees also, repayment of the payment of lease also. Agree na? That's why I cannot bifurcate it. What I can do, one simple way I'll do. I'll find out the इसका present value I can calculate. Can I calculate present value? I can calculate. Hello, understood? How many years am I the agreement? 18 years. So you should apply your calculator. 4.5% only na. 1 divided by 1.045. 18 times you have to press and GT you have to press. Carefully press. Hmm. 14,59,000. Okay, 14,59,200. What is this 14,59,200? Present value of 18 years of 1,20,000. Correct na? But out of that 2 lakh is related to light. That's why. So lease liability, what do I make, my dear? 14 lakh minus 2 lakh I'll do it. Then it will become 12,59,200. Do you agree with me? Hello, correct? Observe carefully now. Now real maja starts. Okay. Now what is the now next thing you have to? So far it is all easy na. ROUA is what the crucial element. Observe very carefully. Okay. Right. You are paying a lease of 12,59,000 rupees for how many years? Correct na? Present value number. Observe carefully, very carefully. Okay. I'm first shot if you don't catch, nothing to worry, don't feel bad. You will understand it. Now only I'll explain. Second time when I'm explaining, you will catch it. How much Nanna? 12,59,200. Isn't it present value terms? Our present value ko can I call it as fair market value in our terms? We can call it so okay. Many times fair market value is determined by present value only. Correct na? This is the present value of the lease payment for how many years of term, my dear? Correct. Let me keep it. 18 years. Agree na? Right? If you want to buy, how much you should pay? If you, instead of taking it on lease, if you really want to buy, how much you should pay? 18 lakh rupees you have to pay. Fair value of the building, how much? 18 lakh only they told. Hello, correct? This is also fair market value or not? Hello? Correct na? If you buy really asset, entire life will be with you only na? It is not for 18 years, it will be for life. Correct na? How much life? Cross multiply. Cross multiplication apply. Huh? Yeah, wrong answer. 25.73. That means remaining life of the asset is 25.73. What is the percentage he sold? 18 divided by 25.73. 70% he sold. Okay, correct na? 70% is sold. No, sir, 70 it retained. Retained. 30% only you really sold. Agree? Now come to the question here. Right here, no here. Yeah. So ROUA will be how much, my dear? Out of 10 lakh rupees of book value, 70% I am retaining. I should record how much? 7 lakh. Hello, correct? Right. What is that they will do here? I'll tell you. Same concept they'll apply. What do they apply? They will tell 10 lakh rupees of book value into 12,59,200 divided by 18 lakh ऐसा बोलेगा. Now you calculate. That 7 lakh. 6,99,000 is 7 lakh. I went by period. They went by amount. Correct? That's all. You see the answer. $7 lakh. Your 2 lakh, 14 lakh, we have written clubbed it. Lease liability and financial liability. Generally, should separate it. Lease liability is different, financial liability is different. That's okay. We can change that. Hello, understood? That's all. No, 10 lakh. Every number is perfect. The balance amount is nothing but gain on the transfer. Again, observe carefully the beauty of this sum. Observe carefully. If you sell 100%, if you sell 100% of the asset, 10 lakh rupees book value item, you sold it for 18 lakh rupees. So 8 lakh rupees is the profit. Agree or not? But actually you sold how much percentage? 30% sold. 30%, 8 lakh into 30%, how much? 2,40,000 only should be your profit. Agree or not? Correct, na? In my way also 2,40,000 only the profit you booked. We have not allowed you to book entire 8 lakh rupees of profit. You sold how much? 30% only. Then 30% of profit should be booked. Why are you booking 70% or 100% of profit? You observed, it is reflecting the fact. Correct, na? What is happening? Ade reflection. That is what accounting. Na? Accounting is not dabba accounting. Obviously, beautiful accounting. You understood now something, some beauty is there in this. It's not like so randomly something by something. ऐसा नहीं किया उन्होंने. They have, I mean, when I realized this, I understood, wow, what, I mean, how much these guys have thought. Correct, na? It's not so easy. Correct, na? After so much of brainstorm, I will say something, you will say something. Correct, na? Afterwards, final conclusion will be something. Let's drafting the same. Thought is coming different and putting the same thing in the words without wrong interpretation. Not a joke. Okay, that's the beauty of this subject, my dear. Yeah, anything you want to take down? If you want, just take a pick. Best option. Right. So tomorrow we'll see that remaining part of what? Yeah, 103 plus 110. All adjustments. I told na every adjustment ka how to deal it at the time of acquisition on the balance sheet date. Both if I explain, then completeness will come to you. Okay, and in addition to that, any other standard if you prefer, we'll do that also. Okay, right. Chalo, let's focus on Ind AS 103, that is business combinations. Basically, business combinations. Yes, our chapter is like corporate restructuring and everything. Everything will be part and parcel. Ind AS 103 plus Ind AS 110. It has to be read together. Okay, when you are acquiring the company, that date accounting will be taking place 103. Correct. But as on 31st March, since you have got a control, correct, now you got a control, then that acquisition will be taking place. I mean, on the balance sheet date, you are going to do consolidation. That consolidation, that general consolidation procedures, rules and regulations are discussed by Ind AS 110. Okay, so that is the first and foremost point to be remembered. Okay, so 103. 103 is business combination. This is just accounting on which date, my dear? On date of acquisition. Okay, so Ind AS 110, that is consolidation. Correct. This is consolidation procedures. Yes, consolidation procedures on the balance sheet date or on the interim date, whichever the date. Correct, na? Till the company holds the control. Correct, na? Till control exists. Till control exists. Till you have control, you will be following Ind AS 110 consolidation. We will be doing it. Correct, na? Right. So that is the first and foremost thing. Right. Listen. Suppose, right, first let me spend little bit time, maybe 10 to 15 minutes time. Ind AS 27. Okay. Yeah. What is Ind AS 27? Ind AS 27 is separate financial statements. Okay, separate financial statements means indirectly I can say standalone financial statements. Yeah, these are standalone financial statements. Okay, so when I say standalone financial statements, my dear, how do you record? Standalone financial statements mein the standard will say investment in associate, investment in joint venture, investment in subsidiary should be recorded at, correct na? So here what do they say? There is an accounting policy choice. First of all, that is an accounting policy choice. Okay, what is an accounting policy choice? Policy number 1, correct. Now whether you can recognize what all the things you can recognize, that is nothing but investment, right? Investment in what? Investment in 3 things: investment in joint venture, investment in associate, investment in subsidiary. Yeah, all these 3 things, it can be measured either at cost or fair market value as per Ind AS 109 it will say. Okay, that means when you say as per Ind AS 109, that is you can do it at either at the FETPL or FETOCI, any one of these things you can follow. Okay, right. Next, it is right. It is an accounting policy choice, amma. Correct, na? What is accounting policy choice in the sense? I can say all JVs, all associates, I want to follow at cost model. Yes, you can say. All subsidiaries, I want to follow at fair market value. Yes, you can tell. Not necessary. Associate, joint venture, subsidiary, all together should be at same method. Not required. One correct now. Associates I want to follow, cost this I want to follow, FEPTVL this I want to follow, FETOCI. Yes, any choice is there. Okay, right. So when you acquire, suppose when you acquire, but most of the right practically everybody follows cost model. Nobody follows the what do you call fair value model. Okay, option is there, but nobody follows because every time you have to get the valuation done. If the other company is a listed company, then not a problem. Correct. Now, I will get the fair value very clearly straight away. If it is not listed company, fair valuation has to be done. And unnecessary expenditure, again, you are dependent on the third party on the last minute. Correct. Na? Right. So, when you acquire, correct. Now, when acquire, what is the journal entry you will, when you acquire in standalone financial statements, when you acquire control, correct. Na? In standalone financial statements, what do you record? Just simply one journal entry will be there. What is there? Investment in subsidiary, correct na? Investment in subsidiary account debit, right? To what? Yeah, to whatever it is, whether you have given cash or whether you have given equity shares, whether you have given debentures, etc., etc. Whatever you give, that will come. Correct? Yeah. And one more thing. Say we said cost. Correct na? We said cost, but actually, if you refer the standard, there is no definition for the cost. There is no definition of cost as per Ind AS 27 mein cost means what? Oh no, they have not spoken. Ind AS 28 ko chalo cost is given. No, they also have not told. But indirectly we are supposed to follow. Cost means what you lost. Correct na? See, what is cost? What I lost is what my cost. What you lost is nothing but fair market value of what I gave. Today if I give you one gold ring, correct? I bought it for 10,000 rupees, say 20 years before 10,000 rupees ko kharida. You understood my point? Yeah, those days it was 10 grams for 8,000 rupees. You understood? 8,000, 10,000, it was like that only. Now today, 10,000, today 1,30,000. You understand? So that date I purchased for 10,000. Today if I give a gold ring, what is that I lost? 1,30,000 da 10,000 da? 1,30,000 I lost, not 10,000 rupees. Correct na? So what is that I lost is the today fair market value I lost. Because instead of giving it to you, if I take it to jewelry shop, they will give me how much money? 1,30,000. That is what I gave you actually speaking. Correct na? So what is cost, sir? What is cost is nothing but fair market value of the consideration. Okay, fair market value of the consideration given is what really the cost. That's all. That only you are supposed to go by. Okay, so what is fair market value? Fair market, that is nothing but the fair market value of all these things. Fair market value of all these things are supposed to be. Hope you understood. Fair market value of, I mean, cash ko fair market, cash only. Equity shares issued, that fair market value. If you had given any debentures or if you had given any other, whatever you have promised. Okay, right. There may be contingent consideration. What is that? Is a contingent consideration. That fair market value also you are supposed to take it. What is that you are supposed to take? You have to consider fair market value of contingent consideration. What do you mean by contingent consideration, my dear? Contingent consideration means what? Today, nowadays, all these companies are there, correct? No? So many companies, what do they say? We have earned so much of profits. So next year we will be earning, correct? Now, today it's like 50 crores turnover we have. Next year 80 crores, that next year 150 crores, that next year 250 crores. Just telling with mouth, correct? No? You understood my point? Whatever number comes to your mouth, you will tell, right? But as a fact, right? How do I know whether it will come, will not come? 50 happened, so 50 may happen tomorrow. Okay. Last year's to current year, last 3 years ka growth percentage if you take, but it is not necessary that same growth percentage will continue in lifetime. Hello, understood or not? For Reliance company also it did not happen. Correct na? Yeah, the Reliance is a Nifty mein big player. Nifty mein heavy weight. Heavy weight is given to, out of 50, Reliance has got so much of weight because the number of shares traded in the market are very high. Market capitalization is huge actually. Such big companies, top 50 companies, if you take, if you check, it has grown by all the last 3 years. Is it the same thing? It is going up next year also? How can you tell, man? Correct, na? Nobody can tell what will happen next minute, next year. Correct, na? It's not possible. So, but people will be telling like, no, we are going to get 250, we are going to get 350 करके बोलेगा. Correct, appa? Today I will give you this much. You take it. Okay. You said how much will come? 250 will come, na? Let it happen. That time I will give you. I'm not saying I will not give. Just wait now. You told what? In 1 year, second year, sales ऐसा हो जाएगा, profit इतना आ जाएगा. That's what you told, na? You also be there in the company, no? You don't need to run away. I'll give you some 10% stake you have. Correct, na? When you are leaving, that time I will give you the money and we'll go. You can go that time. Understood? Anything wrong? Right. Contingent. If the company performs, then I will give you this much of, if you reach the target, what you spoke, then I will give you the consideration. Otherwise, I will not give you that money will not come. Hello, correct? Right. So that isn't it guaranteed will you give? If it happens, I'll give. It depends upon the future event. Correct, which is not under the control of my company. That fair market value means what do? They will obviously consider the probabilities. Correct, na? What are the probabilities to? Probabilities that it will be able to achieve it. Correct, is it 40%, 50%, and present value technique? Everything they will consider. Accordingly, they will determine the contingent consideration ka number. You don't need to bother about it. They will tell you. So I hope you understood. Yeah, that is about your Ind AS 27. So Ind AS 27 may, right, standalone financial statements it is, or separate financial statement is the language. Okay, right. So where you are in India, what happens now? I'll use the word standalone. Fine. In outside India, I may use the word separate. Why me? Reason. In India, you have to prepare not only the consolidated financial statements. You have to prepare as per the law. Standalone financial statements are mandatory. Plus consolidated financial statements. But as per IFRS, when I give consolidated financial statements, I don't need to give standalone financial statements. Are you getting my point? Not necessary. I hope you understood. It is depending upon that specific country's laws. Okay. If you look at some Apple company financial statements, correct na? Apple company, that is there in your mobile only. You can catch it later. Correct na? Apple company financial statement 10K करके it will be there. Form 10K is US में annual financial statements is 10K, quarterly is equal to 10Q, something like that. It will be there. Right. Where do you find standalone financial statements in their annual report? Nothing. Check no once. Okay. You will not find. I hope you understood my point. The standalone and consolidation concept is in India. Outside India, if you give consolidation, parent should give the consolidated financial statements, not the standalone. Why na? See, when you are becoming the shareholders of the parent company, my dear, I am bothered about my company. I am the parent company shareholder. What do I look at? Not in the standalone. Standalone लेके मैं क्या करना? Correct na? As a group, what is that I am doing? Suppose if you say Tata Trust, correct na? What will be there in Tata Trust ma? Balance sheet में investment in investment in this Tata company, that Tata company, all investment list one number, big number will be there. And whatever those people have given the dividends, that will be in your profit and loss statement, number will be there. That's all, no? What do you get from this? What is your sales? Nothing. Other income only will be there, no sales there. Then how is it useful to the Tata Trust? Not useful. What is useful for them? Only consolidated financial statements. Overall, how is my group performing? I am the holder of not a below subsidiary company. I am the holder of the parent company. So me means group, not one company standalone. Standalone concept they don't need to follow. But in India, as per the rules, we have to give standalone. We have to give the consolidated financial statements. That's why I hope you understood. Yeah, you have to prepare it. That's why standalone word will come. Otherwise, not necessary. Where they prepare, I mean, as per outside India, if I am preparing standalone means I am not preparing consolidation. You understood my point? If I am preparing standalone means I am not preparing consolidation. I have taken the exemption. I have taken the exemption. Subject to some 3-4 conditions are there. If you are not in the process of listing, or if your shares or debentures are not listed, and my parent company ko and my NCI people ko I have informed, I have got the permission from them. I am not preparing consolidated financial statements. My ultimate company or iska baap ka company is preparing consolidated financial statements. You can go and get it there. Like that, some 3 conditions or 4 conditions are available. Okay, if you satisfy the conditions, you don't need to prepare consolidation. Our conditions are there in India also. Okay, but in India, if you are preparing consolidation, you have to prepare standalone also. That is the problem. Otherwise, nothing else. Okay, fine. Right. So that is the basic matter, my dear. Now let's go to example. Now Ind AS 103. As per Ind AS 103 business combination. Today let me, that is what is today, that is equal to whatever it is, like say 5th December. Yeah, 5th December, my dear, tell me, we have acquired the other company. Control you have got. Say 80% control, 80% control we have obtained, we acquired. In the standalone books, correct, SFS, standalone financial statements mein, as I told you, investment in subsidiary company account debit to cash or bank or whatever it is, XX numbers we are going to give it. Correct na? This is fine. But what is the consolidated financial statements mein? Do you record any journal entry? We need to record, but we don't record. Okay, actually speaking, we need to record. Right? But in the consolidation ke liye, we don't maintain separate books of account. Agree or not? We don't maintain separate books of account. But that's why we do not record the journal entry. But then you need to record one journal entry. It is supposed to be recorded, but we don't record. That's a different thing. Right? Do we record? Yes. Do we record? Yeah, yes. But that is outside the books. I should say outside the books. Excel में record करेंगे. Excel में record करेंगे, but not in the books of account. A tally में entry will not pass it. As I told you, CFS के लिए separate books of account will not be there. CFS का my financials, all these financials will just combine it and prepare something that is called CFS. That's all. Correct. Now we don't prepare separate books of account. Correct. Now it is just a consolidation. Correct. So, but are you supposed to record? Yes, you should imagine that we recorded journal entry. Okay, what is the journal entry? What is the journal entry you will record, my dear, on the date of acquisition? Investment in subsidiary entry, no. This is for the standalone books. Right, tell me. Assets account debit. You have to record like assets account debit. Assets of whom? Subsidiary. Correct. Now, assets of subsidiary. When I say assets of subsidiary, my dear, correct. Now, assets of subsidiary, when I say this asset may be there in the subsidiary books, may not be there in the subsidiary books. Are you getting my point? It may exist in subsidiary books or may not exist. Yeah. Any example which is may not exist? Not contingent asset amma idu. Goodwill is separate line item will come. That's what is may not exist. That is nothing but intangible asset, especially self-generated intangible asset. Correct na? Self-generated intangible asset. Example, they have got their brands. Correct na? They have got their customer list. Yeah, correct na? That is what is that? It was a self-generated to subsidiary company, but for me, it is acquired. Correct na? So that's why we will be recording the self-generated brands, customer list, titles, all those things which we don't generally record it, that we will be recording because it is acquired. Not only that, any research and development acquired. Suppose research process is getting done by subsidiary company, but I am buying it. Correct na? As part of business combination, I am taking it over. There will be fair value even for that. That also should be taken at fair value. Are you getting my point? So all those assets are going to come in, right? So this will be taken at which number, my dear? This will be taken at fair market value. Correct? Right, sir. Next, what do you record, my dear? Two liabilities, I will say. Yeah, two liability. This also will be taken at which value? Obviously fair market value. Here also, this also same rule. It may exist, may or may not exist. May not exist. Yeah. Now tell me what you told earlier. That is contingent liability. Contingent liability. Contingent liability in the subsidiary books, what will happen, my dear? Contingent liability in the subsidiary book, it is a disclosure. It is a disclosure. Correct now. But we'll bring it to fair value when there is a probable future, not probable, when there is a present obligation arising from the past event. Okay. If there is a present obligation arising from the past event, but even though whether probable future economic benefits outflow is not probable, may not be whatever it probable or possible, still will be recording it. Okay. Contingent liability. Right. When what do you say? When present obligation arising from past events exist. When there is a present obligation arising from the past event exist. Sufficient. Even though, correct na, even though what, my dear? Even though probable future economic, even though there is no probable future economic benefits outflow. Probable future economic benefits outflow. Even though there is no probable future economic benefit outflow, still we will be recognizing the contingent liability at this number. Okay, so it may be there, may not be there, correct na, but we will be recording it, right? That's all. Not only that's all. Anyhow, I'll write separately. If you want me to write separately, it may be deferred tax liability, or it may lead you to deferred tax asset. Okay, why this is deferred tax liability or deferred tax asset? This is arising because of the what is it because of? Because of the business combination. Correct na? Why? Because you have recorded fair market value. Correct na? Their carrying amount was different. For the difference amount, you are supposed to recognize the deferred tax asset or deferred tax liability. Correct na? And there can be a goodwill. Goodwill will be the last number, I should say. That is nothing but the balancing figure. Correct? Then what will happen? Then your purchase consideration. correct? You will give purchase consideration. What is the purchase consideration? Purchase consideration is nothing but at fair market value of the consideration given, right? One more number will come. What is one more number? To NCI, correct? Because you are taking the 100% of assets, na? 100% of assets ले रहा है इधर, इधर भी 100% of liabilities you are taking, agree or not? Then automatically you are supposed to recognize the NCI, correct? Na? ENCI, ENCI, what are you supposed to do, my dear? ENCI, right? Have you noted up? Right? So when I say NCI, NCI is what? This is, when are you recording this journal entry? On the date of acquisition, correct? Now this is when are you recording? On the date of acquisition, on DOA, correct? Na? Right, on DOA, on DOA, fine, right? On the date of acquisition, when you are recording, we have got two options, my dear. We have got two options for what? Two options for NCI, non-controlling interest. On the date, what can you do? You can record it at, yes, you can record. You can record it at fair market value of NCI. Suppose they were holding 20,000 shares. 20,000 shares into what is the fair market value of each rate, you can take it. Or other way around also you can calculate, because 80% you gave how much? Some number you must have given. 80% you acquired. Have you given some amount or not? You gave. Correct na? So some X amount divided by 80 into 20, will you get the 20% ka fair value? Because I am determining 80% ka fair value. Then proportionately 20% fair value I will be able to calculate. Correct na? And again, these two options are, whenever I say option, that is nothing but accounting policy choice. Yeah, again, whenever I say accounting policy choice, Nanna, one point you need to remember all the time. For one subsidiary, I will follow FMV. For another subsidiary, I will follow proportionate to net assets. Not possible. Policy is policy. You have to strictly, consistently, you have to follow for all the subsidiaries same way. I hope you understood. Yeah. So FMV, this is an accounting policy choice. Consistency is something very much required. Right. Next one is what? Next one is proportionate to net assets. Proportionate to fair market value of net assets, I can say. Net assets. Okay. Proportionate to fair market value of net assets. What do you do? That is nothing but fair market value of net assets. Correct na, into percentage. Your 20%, if I say, 20% you are supposed to put it there. That is how it will be happening. Yeah, goodwill separately do you need to calculate? Means goodwill is the balancing figure which you already got it. Correct? Hope you understood. Yeah. So again, see, this is only for if fair market value is a concept, my dear. This fair market value concept is what, my dear? It is only on the date of acquisition. It is only on the date of acquisition. Subsequently, what will happen? Initially, whatever you recognized plus change in the reserves. Correct na? Any percentage, any change in the reserve, subsequently change in the reserve of the subsidiary company will be taking into NCI. That's all. That will be subsequently, no. This is only initially you have got an option. Initially you have got an option. Record it either fair value or NCI. Okay. Right? Yeah. But they are not asking you at this time whether it is a business or not. Correct na? Is it a business? Conceptual questions, right now are not there. Directly they are giving you the big sums. Agree or not? Are they asking you what is a business, what is a control? Correct na? Whether it is a de facto control or a control, no, nothing. They are not actually not asking. Getting my point? They are just giving you the correct consolidation or business combination on the date of acquisition, or this one. Any one is going to be asked for you. Fine. So forget. So whenever I say business, correct now, just listen for a few minutes and that's all, not even few minutes, a minute. When I say it is a business acquisition, correct. Recently I posted in LinkedIn. Okay, right. Say example, my dear. What is that here? one company, what is that they have acquired? They have taken the employees of the other company. Along with the employee, some laptops, okay, some furniture and fixtures. They have taken all these things from another company. Say, E company acquired this. Now, question is, does it amount to business? This company is following Ind AS. Should I follow 103 or should I follow intangible asset that is equal to 38 and 16? You understood my point? What is that they have acquired? Other company ka employee. These are software guys. Team ko they have taken. They have given some consideration to the other company. Entire team is shifted to our side. Right? We have taken their laptops and little bit of some furniture and etc. Yes. Now what should I do? Which standard I should apply? 103 only. Okay. But only if you have only technical employees, how will you say that is correct done? What do you mean by business? When you say business a combination, what do you mean by business first? Business means there should be input and there should be process. Correct now? There should be some process, there should be some SOP, systematic things should be there. Correct now? Then output may be there, may not be there, that is not a problem. Yeah, what is your input? Input is equal to, that is your property, plant and equipment. It may be intangible assets, it may be employees. Correct now? But this is a technical team. This is a technical team. Correct now? Then just by taking one technical team, you cannot say I have acquired entire business. No? Right? Their systems, their processes, and no, that is all going to be followed by me. I hope you understood. Right? Actually, I could have hired these fellows also from the market. Yes or no? Then I cannot call this as business. Then what are you supposed to follow? You are supposed to follow this only. Next question should come. Suppose I have paid 10 crore rupees for this number. Correct na? 10 crore rupees may for laptop fair value maybe is equal to, let's say only 1 crore rupees is laptop fair value, furniture also 1 crore rupees. Just for employees ko 8 crore rupees is employee ka paisa pay kiya. Now how to account for? This happened last week only, we saw. Last week. You understood, no? We know only consolidation. It won't work. Practically, it won't work. Correct, na? Practically, which standard to apply first situation, na? That time, funda. Correct, no? That fundamentals of, is it business? Have you acquired control? Really, does it make sense? Correct, na? I've seen one situation of some other company where they have got 49%, but still they have got the control. 49%, but control of the board is with them. One more situation I have not seen directly by me. My friend was asking me question. Okay, he started the entire business. Got it? But he sold off. I mean, control is like say 80% of the 80%. He in the sense one company. 80% of the stake. I mean, 100% was held by him, but 80% is given to him because he is an investor. Got it? Right. How much stake I have? Only 20%. But entire board is mine. Entire board of directors is mine. Hello, correct? Then what should I do? I only should consolidate because I will take the decision. That guy does not know anything about this business. Orally, he'll just come and review. It is a protective nature. क्या बोलता? Protective, because he also bother. What he'll bother? 50% पैसा तो दे दिया ना. क्या हो रहा है करके एक बार आ जाएगा. We'll explain it to him. That's all. But main running business, because he doesn't know about the business. Our technology and all right? He doesn't know. That's why I know everything. So I will be taking care of it. Got it? First, standard to be applied, not to be applied. Such kind of circumstance when you see, that is where requirement. Decision making, correct na? Right. Once we say, yeah, follow Ind AS 38 करके बोल दिया, तो anybody will follow. Decision making, that is more crucial. That is what required. Correct? Listen, my dear, now. So when I say here, no, here there is no processes, nothing, just taking the employees. Right. What will happen, my dear? Laptop will be recognized at laptop is equal laptop account debit. Correct na? Furniture and fixture account debit. What about this? Human resource cannot be an intangible asset. Where is the control, my dear? Today I paid you some money. Correct. Unless until if you have entered into bond, these fellows will never enter into bond. Got it? Retained earnings me, charge it to P&L, that's all. It is going to be expenditure. Whatever you paid it to these guys, 8 crore rupees will be charged to P&L. And that guy was asking, sir, if I charge it to as a salary, na? No, it is not a salary. It's the kind of some retention bonus. क्या रखना? Retention bonus करके I have to keep it. Are you getting my point? If I keep salary, problem. If I keep a different name also, na, income tax department में exemption नहीं मिले. I mean, you will not get the allowance नहीं आएंगे. Correct. If you should not tweak it, I mean, name exactly information if you give, na, then they will say no, this is not a capital, this is a kind of capital expenditure, I will not allow you करके ऐसा बोलेगा. That is his problem. Understood? So keep as a retention bonus, keep as a other welfare, staff welfare expenditure. रखो अच्छे बात है. Right? It's okay. Then we have kept it as a staff welfare expenditure करके डाल दिया. Big number है, but okay, fine. Then he will give explanation. It is a retention bonus base. Basically, retention bonus है. Correctly speaking, nothing. Frankly speaking, fact also are there. Somebody can argue like this is a capital kind also. Argument is yes. Somebody can argue whether they will win the argument or not, secondary to me, but yes, possible. Then, yeah, you're saying something. Staff welfare. No, but I don't know about the other company ka. What is other normal welfare expense also? How much? We'll say some bonus is given. That's what we kept it here by mistake. Something they will talk some retention bonus. We got a new. I mean whatever. While explanation, it will happen. Many things will happen. And while signing, it was signed as a staff welfare expense. Signed already over. Okay, right. So it's that is a different thing, right? I hope you understood. So first, is it a business or not business? Then only will fall under 103. Otherwise, this is going to be acquisition of assets. You refer my LinkedIn post recently what I have done. Okay, right. There I'll be. I mean, whenever I get some circumstances, now somebody will raise a question, we'll solve that. After solving, I'll turn that into one post and I'll post it there. It's okay. I mean, people also will be reading. If somebody is reading, that is good for them. Like that. Okay. Yes, my dear. So, now, okay. First, what is that? What all we are going to find? What all we are going to find out? But reverse acquisition, they never asked no question. Reverse acquisition, they have never asked the question in the exam. I think one time. Okay. Not high five. I think high five nothing. It's okay. But that is reverse acquisition is going to be obviously high five question. It's not expected to. Okay, let's not deal that. Reverse acquisition is explanation of concept is fine, but too much calculations will be involved there. Okay, because you have to think from the other point of view and you have to more confusion concept that is. It is looks good, but when you are actually getting into the accounting and balance sheet preparation, disclosures when you are doing, no, their confusion will be more and more. Okay, let's limit ourselves not to that. Okay, right. Anyhow, in your examinations, like date of acquisition, it is very pretty clear. Correct na? They will not confuse you. This is the date we acquired this. Karke, they will very clearly they'll tell which date acquired, whether you got the control on this date, or don't need to go so deeper and deeper on that. Okay, right. So date of acquisition is clear. Next, what is that we need to look at? One second. Yeah, control is defined by standard. Identification of acquirer. This is what identification of acquirer. Who is the acquirer? This also you will not face difficulty in the exams. Okay, they will tell directly A acquired B करके they only tell correct ना. A company purchased 80% stake in the B company. Fine. A is the acquirer, B is the acquiree. So straight and so simple. Correct na. Sometimes it can happen in case of reverse acquisition that doubt will come. Reverse acquisition में क्या हो जाएगा? Doubt will come. Where the doubt will come? Right. One small example I'll give you just to catch. You may be aware of it already. Okay. Say this is my company, A company. Fine. Yeah. There is one more company. This is B company. B is a big company, I should say. Okay. A is a listed company. A is what? Listed company. Correct. Now, how does it happen? A will buy the shares. A, how many shares? How many number of shares do you have actually? A number of shares is equal to say 10,000 shares are there. Okay, na? Right. So now what will happen? A will acquire the B company. Right. So B company shares will be with whom, my dear? There will be some shareholders of the B company. Correct, na? So now A has to give the shares to the shareholders, not to the company. No? We'll give the shares to exchange. How many shares do you give? I gave 25,000 shares. I gave it because that is a big company. I issued my 25,000 shares. Are you getting my point? Right. Earlier, the shareholders, they were having which company shares? Listed, unlisted, that was unlisted company. Correct na? Right. Now what is happened? Their shares are exchanged by, their shares are taken by the A company and they got the A company share. So now their shares became earlier unlisted, now it became listed. Agree or not? Now. So now tell me, here also we have to, if we have 10,000 shareholders are already there. Now who is controlling this? Actually B company is controlling. B shareholders are controlling. Agree or not? So here it looks like this is the acquirer. No, it is not the acquirer. This is acquiree. Correct now. Why acquiree? B shareholders have how many shares? 25,000 shares are there. Out of how many shares? Out of 35,000 shares. How 35,000 shares? 10,000 already they had plus new issue 25,000, 35,000. Correct now. So into 100%, 100. So have you got more than 50% or not? Yes. So here this is acquiree. Actually this is a acquirer. Acquirer. Or sometime it may happen ki, correct na? We will say we have one company, here also one company. This is A company, this is B company. Correct na? We will close these companies and we will open one new company called AB company. AB company will give the shares to A shareholders, AB company will give the shares to B shareholders. Correct? Here also shareholders will be there, here also shareholders will be there. Who is the acquirer? AB na, B na, A na, there are only three companies. Okay, I'll say number of shares. Okay, some 25,000 shares to this company, 10,000 shares to this company they give. AB Limited gave 10,000 shares to A Limited, A Limited shareholders. AB company gave 25,000 shares to B company shareholders. Actually, B company is the acquirer. B is the acquirer, not AB company is the acquirer. Because this is controlled by whom? This is controlled by this team. B team is acquiring. Correct? B team is having the control. Correct? So, ultimately whatever the resultant company, what is that? Who has the control over that company is what important. If that company is controlled by B, then it is B is the acquirer, not the A company, not AB company. But issue purpose, issue purpose AB is issuing, but AB is not the, AB is a dummy basically, one dummy company. Got it? Right. So that is what the point to be noted here. That is what the point to be noted. Who is the identify the acquirer basically. Yeah, reverse acquisition we spoke just now. Right. Determining the acquisition date. There is straight and simple, my dear. Okay. Yeah. Sometime it can happen key. It may happen, the acquisition may happen in stages. Correct na? So maybe first date, right, date, I mean first year I may be having only 25%. Next I will have another 10%. Next I will have 20%. Correct na? This when you have, correct na, what is this cumulative kitna? That is equal to 35. Cumulative is equal to how much? 55. Correct na? Which date you acquired? E date of this 20% acquisition, that is only date of acquisition. Okay, all right, that is only you are supposed to consider as date of acquisition. Understood? Done. Now, what is the next? Recognizing the measurement and goodwill. Correct na? This is what the next important concept. Yeah, we already calculated, no, in the journal entry itself we have already computed, isn't it? What is that we should regard, my dear? Fair market value of the purchase consideration, whatever you give, all, this includes contingent consideration, everything it includes. Okay, actual consideration, deferred consideration, everything. Okay, right. So that consideration plus NCI, that is either at the fair market value or at the proportionate amount, NCI number, correct na, sum total will come, then minus, then fair market value of net assets, fair market value of net assets, identifiable net assets, at least identifiable net assets on the date of acquisition. Okay, on the date of acquisition, then this is my goodwill. This is what goodwill. Correct na? Can there be capital reserve? Practically, what the concept standard also says, there is no possibility to get at the capital reserve. Why will, because I am already taking this at a fair market value, ma. Correct now, only assets if you sell separately also you would have got that number. Why somebody will give the business at a cheaper rate? It can happen only at a stress sale. Correct na? I mean, I have to close the company soon as per the requirements, loan pay karna. That means that time under the rare circumstance it may happen. That's why standard also says, you know, what standard says? Okay, here capital reserve, can it come? Yeah, it can come, but that is rare circumstance. Capital reserve, rare circumstance. Okay, that is a rare circumstance. It is not a frequent circumstance. Standard what it says, if it is negative number is coming na, it will tell, what it will tell, you know, array, if it is coming negative number here, means first to go and check whether this fair value you have calculated correctly or not. Correct na? Either correct kiya kya, either correct kiya kya. Somewhere something is wrong. How it is correct? Got my point? So they only tell, go and recheck once again and come back. I mean, they are not believing that capital reserve will be there. But so if the capital reserve is there, no, capital reserve is there because it's a stress sale. Correct now. Where is this? Under stress. You have to sell the company within some time. Court order is there. Bank forcing. Got my point. Now I am selling it. I am selling with nobody I am getting. Right. Somebody who are told he is asking for 25% discount. Okay, de diya. Kya karna bol? Correct now. I have some my pressure son. Yes, correct. When you are in urgency to sell, you will be selling at discount only. Correct, not at a good price. Right. If it under stress sale, what is the question here? You know, is there an evidence? Is there any evidence? Evidence of capital reserve. Capital reserve means what? Yes, it is correct. I got it at capital reserve because of the other parties under stress. That's why you do have evidence. Yes. Otherwise, I would have not got it. If you say evidence is there, my dear, that capital reserve will be routed through OCI. It will be presented in the OCI. OCI 2, it will go to capital reserve, reserves and surplus. Okay, right. If you say no, capital reserve does not have, I don't have any evidence of such thing, then it will directly transfer it to, it is directly transferred. It is directly transferred to reserves and surplus, other equity. It directly be transferred to other equity. Okay, only when you have got some evidence, then it will be routed through OCI. OCI will touch, otherwise OCI will not be touching that. Okay. Yes, my dear. So now the question, right? This is what we have spoken. Right. Next, fair value of purchase consideration. What is the fair value of purchase consideration, Amma? First of all, whenever I say the fair value, Amma, E fair value, E fair value, E fair value, all are as on date of acquisition. Okay, that's why date of acquisition is important. Yeah, date to fix karo, because fair value will be keep on changing. Correct na? Fair value today, fair value of one share is not same. Fair value of mutual fund will not be same. Value of everything is keep on changing. Correct na? If there is a good gap is there, then whatever you have determined earlier may not be suitable now. Agree? Yes. So that's why all these fair values are as on date of acquisition. Next, when I say fair market value, correct na? Fair market value of PC, purchase consideration. Sir, I am issuing shares. You are issuing your own shares. Your own shares. Acquirer, correct na? You have to determine the fair market value. Anyhow, they will tell. You don't need to bother. Correct. There is one more thing called deferred consideration. What is this called? Deferred consideration. What do you mean by deferred consideration, my friend? This is guarantee, pakka. This is not contingent. Okay. This is a guarantee payment. Guarantee payment. Okay. When is it payable? Payable after 12 months. Payable after 12 months. Pakka payment. Doubt nahi hai. No contingency involved. Correct? Okay. No contingency. No contingency related. No linking. I will tell what? Deferred, correct now. What is the example I will tell? I will tell 10,000. Correct now. 10,000 payable. Payable when? Payable after 3 years. Karke I will tell. 10,000 pakka will pay. There is no doubt. Okay. Only they are just postponing the payment. That's all. So now what are we supposed to do? You have to bring it to fair present value of the deferred consideration. You are supposed to take it. Correct na? So on the date of acquisition, what do you do, ma? Then you say example rate of return. Rate of return. What is the rate of return? Say some 10%, I'll keep it. Okay. So on the date of acquisition, what do you record? Present value will be that is equal to 10,000 into 0.751, 0.75 लिखेंगे मैं 7,500 rupees will be considered in the PC. PC में add करो. Hello, understood? Right. What is the journal entry? How does the journal entry will happen? Correct na? Journal entry में 2 deferred consideration. Correct na? 2 deferred consideration करके one line will write 7,500 rupees will write. Are you getting my point? तो PC लिखा ना? Assets account, debit, liabilities account, credit, goodwill account, debit, NCI, credit. There are 2 deferred consideration payable. Hello, correct? Next question. You need to focus where, sir? We need to focus. This deferred consideration is what? Non-current asset, non-current liability. Correct, na? Yeah. You have to classify. Is it a current liability or non-current liability? Because it's a liability first. It's a current liability or non-current liability. It's a liability. End of the day. Hello, correct? Right. That you need to be careful. Right. This is which date I am telling? On the date of acquisition. On subsequent date, what will happen? Suppose date of acquisition is equal to 31st December 2024. Now, this is a balance sheet date. Balance sheet date is what? 31st March 2025. What are we supposed to do? Deferred consideration को unwinding करना. Correct na? This should be unwinded. You are supposed to do unwinding. What is unwinding? Unwinding means again you will say finance cost account debit. Correct na? To deferred consideration. Deferred consideration. That is equal to 70. What is that 75 number into 10% into 3 divided by 12. Because 3 months interest. Calculator. 188 rupees will be transferred to finance cost, and that number will be going to balance sheet. Correct, na? Hope you followed me. Deferred consideration is straight, simple, nothing to worry. Next, let me explain you. Are you comfortable? Shall we go ahead? Right. Next point is what? Contingent consideration. Let us discuss contingent consideration. Yeah, contingent consideration. In case of contingent consideration, what will happen? Contingent consideration. Contingent consideration, first thing, question. What are you going to give them first? Consideration correct. Deferred consideration is amount payable basically. Deferred consideration is a liability normally. I will pay this much money. Contingent consideration can be what? It can be shares, it can be rupees, correct? Na? It can be anything. So, what is contingent consideration? Example, it may be I will pay you shares or I will pay you amount. Correct. Amount. That is depending upon future. Depends on future contingencies. Yeah. Depending upon the contingencies involved. If you achieve this, I'll give you. If you don't achieve, I'll not give you. Correct? Huh? Now, if you say I am going to give shares, so contingent consideration, my dear, right? I will tell you. First thing is simple, amma. Day one, first I will say date of acquisition. Date of acquisition, you have to measure the fair market value. Measure fair market value. Okay, they will give directly straight away number. You don't need fair market value wherever I say. Practically also, that is not our job. That will be done by a valuer. Okay, na very few cases may we'll also do calculation, but not with respect to shares and etc. Most probably will give it to other party. Okay, right? Fair market value number you are supposed to measure. Agree? Right? But question is what? Contingent consideration करके रखेंगे. Correct na? But the problem is here, is it whether the contingent consideration is it going to be classified? Classification. How are you going to classify? Is it going to be classified as equity na? Is it going to be classified as financial liability na? It is matters. Correct na? If I say I will issue shares, example, I will issue shares, then it is going to be equity. Got my point? Fixed number of shares I am going to give. What am I going to give? Fixed number of shares. Fixed number of shares we are going to issue. Then it is equity. I hope you understood. Right. So financial liability means which is payable in rupees. Payable in rupees. Something I will pay. If that happens, I will give you this much of money. Right. Why is that why is that we should bother? If it is a financial liability on the balance sheet date, correct? Now we are talking when, my dear, it is on the balance sheet date. You have to remeasure fair market value. You have to remeasure at fair market value ko once again you have to calculate. Once again you have to measure the fair market value, and there will be difference between old market value and new market value. Yes, na. That difference will be transferred to P&L. Difference to profit and loss statement of the next year. Current next year, whenever you are doing it, na, the difference will go to P&L. Okay, but if it is equity classification happened, no remeasurement. Okay, no remeasurement. We don't touch it. As I told you already, once it goes to equity, no touching. That's all. No remeasurement, no looking back at it. It will continue same number, it will continue. Okay, our number subsequently, really if you had issued the equity shares, then that number will be debited, equity share capital will be credited. Okay, no sir, they could not achieve something, that is gone, transfer it to retained earnings. That's all. It is always like that. I hope you understood now. Okay, Adi, this is related to contingent consideration. Okay, now next point. So fair value of purchase consideration we have spoken, correct na? Right? What is a contingent consideration? We spoke on this matter. Business combination achieved in stages. Let me handle this. Okay. What is this? We need achieved in stages. BC in stages. What do you mean by stages? Not in one lot, two lots or more than one lot, you have done the thing. Correct na? Listen, my dear. Suppose we got say 15% stake. How much you got? 15% stake. 15% stake at what number? Let me put some number. 10,000 rupees ko kharida. When? 1 year ago. Okay. Now, today that is equal to 31st, assume 31st December 2024. Now, you have acquired 40% stake you have acquired and you paid 60,000 rupees you have paid for this time. 40% ke liye 60% you have paid. Correct na? Right. Initially, what is the journal entry you must have recorded? Investment in X company account debit, that is equal to 10,000 to cash or bank, you must have recorded 10,000 rupees. Do you agree? Correct na? Now first thing, what this is today you paid, so this is obviously at fair market value. Agree na? But what are you supposed to do? Whatever you have acquired earlier, na, 10,000 rupees should be not reversal, should be measured to fair market value. What you should do? Bring it to fair value. Hello, understood? Right? What is that you should do? Bring it to fair value. This you bring it to fair market value. Okay. What is the fair market value, my dear? Now if you say, le lo calculator le lo. 60,000 divided by 40 into 10. 60,000 you paid for 40. For 10 how much? How much ma? 15,000 it will come. Correct na? So is there a gain of 5,000 rupees? Yes, 5,000 rupees. So what are we supposed to do now? What are we supposed to do? Investment in X company account debit 5,000 to profit and loss. Again, whatever you say, again, that should be transferred to P&L, no doubt. Nowhere else it will go. So what will happen, my dear? So investment in X account debit 5,000 rupees. Correct na? Investment in X account debit 5,000 to profit and loss 5,000 rupees. It will happen like this. But hold on, right? Observe now carefully. This is first level entry. Now, alright, this is obviously on the date of acquisition we are recording. Correct. Oh, 15. Sorry. Yeah, 15 correct. You gave 15,000. Wrong number. 22,500. Okay. Yeah. So how much is this? 15% is correct. No, I didn't. That's my mistake. Okay, 22,500. So 7,500. 10,000. This is 22,500. So that is equal to 12,500 rupees of gain. So 12,500 rupees, 12,500 rupees correct. Done. Now the question, come to the point here. Okay, what is the point, my dear? On the date of acquisition, you will be acquiring the other company now. Correct now. What do you record? You will be recording the assets account debit. Correct na? And you will be recording two liabilities account debit. Goodwill also you will calculate. Correct na? And to NCI also you will record. To my PC, PC means what is that? Today what you paid is 60,000. EPC 60,000 also you will record it. And what do you say? To investment in X. Now you bought it to 22,500 rupees na. Our number also will be reversed. Okay. Yeah, that is what you gave, correct? Earlier you gave 60,000. Today what you gave is, earlier you gave 22, present value 10,000, but in the fair market value terms it is correct. Now, to get the control, what is that you paid totally? I paid totally 82,500 rupees is what I paid to get the control. Agree na? I hope you understood. Right. That is what in stages, mate. If it is happened in stages, first you should bring it to Aja on the date of fair market value को लेके आना by transferring it to P&L, and when you are taking the other asset company का assets and liabilities and everything, when you are taking, you already brought this, correct na? The 10,000 plus 10,000, I mean 12,500 plus 10,000 is equal to, you brought this number to 22,500 rupees को लेके आया. That number you will be reversing it, because that is what you gave it for getting the control. Is this clear? Correct. So that is what business combination, I mean if it is acquiring in stages. How to account for direct cost related to acquisition? Tell me directly, will tell. Direct cost, that means any brokerage cost, correct na? Yeah, brokerage cost, due diligence, due diligence will happen. Yes or no? Somebody has to, correct. I want to acquire another company. I saw financial statements, all super only. But when you go to a company, when you really enter the company, when you see the evidences, it will not be there. Correct na? People just do cooking the numbers. Correct na? They keep whatever the number they want. Trust may not, correct na? If I want to really buy, means what will happen? First due diligence will happen. Correct. So much of legal fees you may need to pay, etc. etc. Okay, so many things you are supposed to incur. What should I do all these numbers? Charge it to P&L or shall I capitalize it? It's directly related to acquisition, that's why shall I capitalize it? It should be charged to P&L. Why? No, it's part of acquisition. That time control is not there, not the problem. But this is spent for the acquisition, you know. Correct. To take a decision, it is directly related to acquisition. Brokerage also you paid. Why you paid? If you have not bought it, you would have not given the brokerage at least. Correct, no? Broker ko when do you give? When the deal is done. Whoever it is related to acquisition. Correct, no? You purchase one laptop from US, you will courier it here. Courier ko you will pay. Courier is third party only, no? Will you take that cost or not? You will take, no? Why you are not taking here then? That is not the way. Okay, answer right. Charge it to P&L, correct. I know you will get mark. Okay, right. From that angle, yes. But the point is, in the business combination, you are already measuring the all assets at which number? All assets at fair market value. Means if I sell this building, example, say example 10 crore I will get. 10 crore I will get. Just because to acquire this company I paid a brokerage, it will not give me future economic benefits ko fetch nahi karega. You understood my point? If this assets and liabilities, if I give it off to somebody, what do I get? That is the fair value. That value is already recognized. So you paid brokerage, you paid legal, you paid that, this and all, that will not add any value of any asset in my situation. Agree, na? Right. Because I have taken already at, that is the only reason. Because already assets and liabilities are taken at fair value. Then further spending, no. Now one question should come. Example, think this way. Okay, I have acquired the company A. We have acquired company A. Company A ka land will be there. Lands must be there, correct na? Now, E land, correct. Now, what is your company, sir? My company is B company. Correct na? Now, A company lands are supposed to be shifted to in the name of B or not? Otherwise, your writer will comment now. Immovable property not in the name, Karo report mein aa jayega. Yes or no? Correct. It should be in the name of your company. It will take some time, immediately will not happen. Maybe in 6 months, 1 year, our company names should be transferred to, correct now, land name registration. It should be registered in your name or not. B company ko registration karna na. Yes, obviously registration should be in the name of B. Now tell me, the registration cost do you registrar will do free of cost? No, they will charge. Correct na. Now our registration cost, what do you do? Normally, I would have capitalized, correct na? Any land I purchase, land registration cost, I will capitalize it. Now tell me what should I do then? And practically all these nonsense will come. Questions they will never ask such questions. Correct, na? Not required, maybe fine. Just example. Charge it to P and L as part of a BC may. If you are doing this, it will be charged to P and L. Okay, BC may if you are doing it will be charged to P and L. Separately land you acquire, you would have capitalized it. There is nothing, that is perfectly all right. But it is not land acquisition. It is part of BC discharging. All such cost will be charged to profit and loss statement. Hope you understood. Right. Sometimes it is a rare circumstance, ignore it. A business combination without transfer of consideration do happen, I know, but not necessary. Right. Next, non-controlling interest that we already spoke, that is minority interest as per accounting standard told. At the initial recognition, correct na? Right, you have got two options, fair value or proportionate share, proportionate amount mein, correct na? Right. One time they asked some question on this, only NCI related question only they have asked for 6 to 8 marks. Easy question, but long ago. Don't expect that will be repeated. Okay, right. Gain from bargain purchase, capital reserve concept, which we explained. Correct na? Generally, it is expected that, see this, if there is no clear evidence of gain, correct na, then it will not be routed through OCI. It will be directly transferred to the reserves, capital reserve, reserves and surplus may it will be presented. Okay, E point, correct. If the gain exists, see after review also, standard says, what the standard says? It says that it is extremely rare circumstance. It won't happen in general. And again, you know, same concept, IFRS may, they will tell that in case of IFRS may what will happen, no? IFRS 3 says, if the gain is there, that gain we are transferring it to where? OCI to reserves and surplus co, it is going, correct na? As per IFRS, will be transferred to P&L. P&L, no OCI, no capital reserve, it's a gain. I got a better deal, that's all. I'll transfer it to P&L, not to OCI, not to capital reserve. Capital reserve concept does not exist in IFRS 3. That is a carve out. Okay, it is a carve out. IFRS 3 is telling transfer it to P&L. We are telling we don't want to tell it to transfer it to P&L. It's a capital transaction, will go somewhere. We are telling that's fine. That is ICA has taken a stand. Okay, right. So now come to the net identifiable, correct now, net identifiable assets. This is, we are already there in this. Recognition measurement, there are actually too many complications are there. Okay, yeah, example, pre-existing relationship you are cancelling. I think they were asking, no, one question has come by chance. I think one question, not a deeper level, but not on the pre-existing, it is a part of the big sum mein one small point. Okay, we'll deal this. Pre-existing relationship mein kya hota, and again, this is one point. This I'll come to pre-existing relationship, no doubt. Okay, na? A transaction that remunerate to the employees or former owners of the acquiree for the future services. This is important. Okay, right. Now, earlier you are MD. Now what I will ask, even though I have taken the control of it, I'll ask you continue to be MD for another 2 years. For being MD, I will pay you, correct na, per annum 1 crore rupees. So 2 crore rupees I will pay you the remuneration. All understood? This 2 crore rupees is not part of business combination. But why? He is serving as an MD, correct na? Yeah, MD cost will be not small number. MD cost is always big number. Correct. He is the leader who is running the show. So his cost. So what should I do? 2 crore rupees will be charged to P&L whenever it accrues to him. Correct. He stayed for 6 months. 6 months ka salary I should pay. Understood. So first thing, is he getting the money as is this previous owner, or is he getting the money because he is serving the company today? Why amount is given to you? पर्पस क्या है ಅದು अनालाइज करना पड़ेगा. So you should read the contract and agreement, then it will be transferred to, correct na, it will be right. Look at this, my dear. Look at this concept capsule 18. Very basic thing, not a too much difficult thing. What is happening, my dear? ABC company acquires all the outstanding shares, 100% shares they have taken in a business combination. XYZ company had 3 shareholders with equal shareholdings, 2 of whom were also senior level employees of the XYZ. Yeah, they must be the executive directors earlier, and would continue as employee post acquisition after the okay, post acquisition also they wanted to continue. That may be one part of the agreement also. You understand my point? All of a sudden, what will happen? You were running the company for 10 years. Today I come and I purchase the company. You are the main faces. Correct na? You 3 guys jump. Shares sale kiya, gaya. Correct na? What will happen? No. Your rumor is something, correct na? Rumors can come from where? God knows. It will come. Okay. Right? So people will feel right. Everybody has gone. Correct na? Why should we also be there? Karke employees also will leave. You understood? Even though they'll say, no, I'll give you good amount of money. Sometime it happens. Security nahi hai. But if the same 3 people of the company, if they stay there and say, why you worry? You are getting a good salary. Correct na? Pakka, I am also going to be there for next 2 years. Then you see, na, manage that people also will be there. I am also will be there. I am there. Why do you want to leave? Moral support or moral, correct na? That something is there. Then there will not be drastic changes. Are you getting my point? Right. Earlier, I was directly talking to my customer, talking to supplier. Now, all of a sudden, new guy will come. Tone may be different. Correct, na? Relationship may be spoiled. That's why to smooth transition ke liye 1-2 years something will keep the same guys. Mandatorily will try to keep. That will be one part of the agreement. First deal agreement, deal may it will be mentioned generally. So the employee shareholders will receive 60 lakh rupees plus additional payment of 1.5, 60 crores, whatever it is, 1.5 crore rupees to 2 crore rupees based on the multiple earnings over the next 2 years. Okay. Non-employee shareholders each will receive 1 crore rupees. The additional payment of each these employee shareholders will be forfeited if they leave the employment of XYZ Limited at any time during the 2 years following the acquisition. Okay. 1.5 crores, whatever additional payment is there, no, that will give you, right? But if you leave in between, no, will not give you. Correct. Now that means it is for a, what is the purpose? For a salaries. Isn't it kind of salary only or not? Not because you are a shareholder. Correct. Right. So that is the point. Next, the salary is received by them is considered as reasonable remuneration for their services, right? How much amount should be attributable to post combination services? Tell me in this, right? This is non-employee shareholder, this is not an employee, correct? Now, whatever you are giving is obviously in the holder, in the position of a holder, shareholder, correct? Now, not for employment or something. Only 1.5 crore rupees will come into that circumstance, okay? So, in accordance with, in the instance, additional consideration of 1.5 to 2 crore rupees, whatever we spoke, that is a post combination services, correct? Okay. But next, what is that? Point over for the 2 years following the acquisition, that is 60 lakh is attributed to consider. Okay, first number is talking. E first number is E first number, E number. E other numbers are what? Consideration. What is this? Not for remuneration, consideration. This is only the 1.5 to 2 crore rupees is depending upon the performance of, correct. That will be accounted after post combination. I mean, after business combination, salary accrual, something will happen. But e-payments of 1 crore 60 lakh rupees will be part of business combination where we will account it as a consideration given to other party. All understood? Okay, right. So before going to this, let's go to the early, this one. This is something crucial. Okay, right. It is not so straight. It is not so straight, but you need to a focus. Yeah, you should have a focus, otherwise it will be bounce. Right. The acquirer and acquiree may be having a relationship before the business combination started. Correct na? See, there can be business combinations before number of business relation between whom and whom. Listen, there is company A, there is company B. Okay, company A acquirer. Okay, right. This is acquiree. Correct. What is the date of acquisition? Sir, date of acquisition is 31st December 2024. Correct. But before this, there were two unknown people, sir. Could be reason one, but it was not like that, not unknown. Before this 31st December, before A is a supplier. Yeah, A is to supply the goods and B is a purchaser. Correct na? Or ulta. Agree? Correct na? Or A may be A is a giver of what is the software technology support. They were giving technology support. These guys were taking ulta. Or there may be relation, they were already fighting in the court of law. Some regarding some cases. Okay. Yeah, one guy is defendant, one guy is a plaintiff. They were already fighting before. But okay, now kaam khatam. Understood. Now the question is what? Now as part of business combination, on this date, I will pay you X amount as a PC. Correct na? And as part of the agreement itself, we will say, Are you have to correct na? There is one case now. I filed a case against you. Correct na? Do one thing. What do we do one thing? Right. Out of this na, some 10 lakh rupees you 10 lakh rupees I will pay less. Let's close the case. Understood? Both of them understood. Are you getting my point? Whatever, amicably they have spoken and they wanted to clear all their problems. Hello, understood? So now what will happen, Amma? If you had paid, say example, here 10,000 lakhs you had paid, but entire 10,000 lakh is not for business combination, no. To clear the before relationship ko close karne ke liye, so 10 lakh rupees will be pre-existing relationship closure charges. So our balance amount is the PC. That is what the PC that should be considered. Okay, when you see some two examples of it, then you will catch it perfectly. Okay, but understood now overall what it is. Yeah, so when the payment is happening, just because the payment is happening on the date of acquisition, you cannot say entire amount is for the business combination. That will be considered for goodwill calculation. No, if I say 10,000, if I keep, my goodwill will be 10 rupees jasti. Correct na? If I take 9,990, then it will be goodwill is lesser by 10,000. Hello, understood? So it will have impact, different impact will be there. We need to be careful on that. Done? Okay, look at this. The acquirer and acquiree may be having a relationship before the business combination started. Correct. It may be sometime contractual relationship, as I told you, vendor, customer, licensor, licensee, such kind of things may be there. And second thing is what? With the non-contractual, that is some plaintiff and defendant. Yeah, they are fighting before this acquisition. Before already they were known. They were known as fighting, but now they purchase one company, purchase another company, and matter closed. Correct, na? So in this case, what will happen, my dear? Look at this. Look at this information carefully. Look at the information that whatever I have given the bracket. So what is that you identify here, my dear? They may enter into arrangement during the negotiations. Correct, na? As part of negotiation, we had some issue. Let's clear that issue. Karke they will enter. They may write that part also in the agreement, but that is old relationship closing, not the new relationship ke liye paisa. Understood? So it is separate from the business combination. Correct? They are called separate transactions as per the acquisition method. Acquirer should identify the separate transaction and they will not be recorded as per the 103. Correct? No, it's not part of. First you should close it. That's why our number, whatever the consideration paid to clear the old cases, or receipt for the old case, one guy will receive, one guy will pay. Correct? Na? Should not be part and parcel of 103, should be dealt separately. That is what the point. Okay, unsettlement of the pre-existing relationship. there may be a gain or loss, which will be obviously recognized in the P&L on the date of acquisition. Yes, let it go on the date of acquisition, but not as sitting as part of the BC. Goodwill calculation ko nahi aayega. How to calculate gain or loss? Yeah, this depends upon is it a contractual relationship or non-contractual relationship. Okay, right. 1 second. Yeah, contractual, non-contractual. In case of non-contractual relationship, yeah, that is non-contractual means what? Where there is a plaintiff, defendant. There is some legal cases going on. Now I pay something or I receive something, so that case will be closed. Agree na? Right. Look at this. Right. So before the combination, there is a legal case. Correct. So one guy is a defendant, another guy is a plaintiff. Perfect. In these cases, gain or loss is on the effective settlement is measured at fair market value. You look at the small example, you can catch hold of the circumstance entirely. Okay, my dear. P Limited is a defendant in a lawsuit. We are fighting, and S Limited is a plaintiff. P recognized a provision. Correct na? P recognized a provision. Yes, what is that he is saying? P balance sheet में P company का balance sheet में already provision is there. How much provision is there? 8,000. Why? He felt I will lose. Correct. It is probable future economic benefits outflow. So he followed Ind AS 37 and he made a provision. Okay, as per 37. On 1st January 2019, P acquired the S company. So now no more S company will continue. If the lawsuit continues, I am fighting with whom? I am fighting with me only. Correct na? It will be not correct. That's why. What is that we said? We'll pay you 1 lakh rupees. Correct na? Who will pay? P will pay. P will pay 1 lakh rupees and clear it. Case ko withdraw karo. All understood? Right. So P will be paying 1 lakh rupees to S company shareholders. Obviously, S company shareholders, because we already believed that we are going to lose the case. That's why we made a provision. Correct na? The acquisition effectively settles the lawsuit. Sorry. P acquires the company for 1 lakh rupees. Sorry. P acquires the company for 1 lakh. Total PC is equal to 1 lakh. But out of that, the acquisition effectively settles the lawsuit by paying 5,000 rupees. That means what? 1 lakh rupees में 5,000 rupees is to settle, 95,000 rupees is to acquire. Have you understood my point? 1 lakh rupees में क्या करना? 1 lakh rupees is 95,000 rupees is PC and 5,000 rupees is settlement of the correct. So now, yeah, then I'll account separately. 2 cash is equal to 5,000 rupees I'll account. Correct na? And have I made a provision earlier? Yes, I made a provision of how much? 8,000 rupees. That is my correct na. To profit and loss, I will transfer 3,000 rupees. I will transfer it to P&L. There is a gain on settlement. I'll transfer it to P&L. Clear? Right. So now, in accounting for the acquisition, the consideration transferred to the acquiree is actually 95,000 day, not the 1 lakh. So, right. So, based on 95,000 rupees, we will be calculating goodwill. Is that matter simple? Like this. First, pre-acquisition relationship, something is there. To close that pre-acquisition relationship, some amount is paid. Right. You pass this journal entry separately outside the goodwill calculation and etc. Then it will happen. Okay. Right. That is the first point to be noted. Profit and loss of the P company. Not normal. Standalone may it will come, means consolidation may also it will come. 3,000 rupees a gain. In standalone also it is a gain. In standalone also it's a gain. So same gain will be there in the consolidated P&L also. That's all. Yeah. Let's go to the next small concept. Yeah, same concept only, but in case of contractual relationship. Okay, na? What did I say? Contractual relationship. Earlier is what? Non-contractual relationship. That was pretty easy and straight. Correct, na? Above one is 8,000 rupees, you made a provision, settled at 5,000 rupees. So you got a gain of 3,000 rupees, you transferred it to profit and loss statement. Balance 95,000 rupees is considered for goodwill calculation or something we spoke. Done. So in case of contractual relationship, what will happen? Yeah, here also some gain or loss can happen, my dear. You need to have understanding and attention. Okay, there is a carrying amount first. Carrying amount means what is in the books minus either A or B, whichever is lower. Where is A? Here, this is A, this is B. Okay, whichever is lower. A number you should keep it here. Carrying amount minus this number. What is that number, sir? Amount by which a contract is favorable or unfavorable compared to the market from the perspective of the acquirer. Okay, off market terms, I mean, what is the fair value? I mean, what should I say? Right, to explain, example will be the better part. Okay, I'll read example, then I'll go back to the sentences, we'll interlink it and we'll understand the concept. That is sometimes, no, with example, you will get catch better. Right, can you take few seconds of time and just do read this? I mean, at least question up to this level you read it. Yeah. So P Limited sells goods. Okay, P Limited sells goods to S Limited under a long term, okay, fixed price supply agreement. Long term agreement, fixed price means one a unit, okay, one bottle I'll give it to you for 100 rupees. Already agreed, entered upon, fixed price. Okay, but listen carefully. Situation, if you understand, it will become easy. The supply agreement commenced on 1st June 2017 में आ गया. It is going to expire on 22. So 5 years agreement it was already entered. Till 22 tak you have to supply me at a specific rate, fixed rate, no change in the rate. A clause in the agreement states that either the party has the right to cancel the agreement by paying a penalty of 5,000 rupees. Okay, if you want to cancel, you have to pay 5,000 rupees and cancel. Hello, understood? Right. Now listen. The amount to pay on cancellation of contract as per the agreement if it is unfavorable. If the contract becomes unfavorable, I want to cancel. Okay, useless. That means E number shall I keep 5,000 rupees here right now? If I want to cancel, I can cancel. But if I cancel, I have to make a payment of 5,000 and cancel. Agree? Right. Hold on. At the time of acquisition, right, P acquires the company in the middle. Correct. Na? This is 2019 is coming obviously in the middle of the contract is still continuing. Correct. Na? It's not contract is expired. Now, when the supply agreement has 3 years more to left, yes, 20, 21, 22, 3 years are there. At the time of acquisition, P determines that although the contract currently remains profitable, okay, P sells the goods. If I continue to sell to S at the fixed rate also, it is what is it happening, my dear? The contract currently remains profitable. The pricing under the contract is lesser than the market price for the goods. That is, okay, what is that? The agreement is unfavorable to P. Okay, profitable is different, favorable is different. Try to catch it. Listen, what is my cost of manufacturing? Cost of manufacturing is equal to 8 rupees. Listen carefully, my fixed selling price is equal to 10 rupees. What did I say, my dear? Fixed selling price is equal to how much? 10 rupees. Is it profitable or not profitable? Profitable, correct. Now, so what is the profit you are getting? 2 rupees. But this is a fixed already number. Fixed now. But actually, if this contract is not there, market may people are not selling for 10 rupees. Market may people are selling for 12 rupees. Hello, understood? If suppose the contract is not there, what I will do? I would have sold you only at the market rate. Market rate is how much? 12 rupees. So now what is that? 4 rupees I would have made a profit. Right. So the contract is favorable or unfavorable? Unfavorable, because you are getting a less profit. Reduced profit you are getting. Agreed? But is it loss? Profitable only. You are making a profit, but you are making a less profit. Have you understood my point? Now read the line. Now with this explanation you read it. The contract currently remains profitable. Yes, I am into profits only. I am not selling for a loss. Okay, alright. As the pricing under the contract is less than the current market price, this is unfavorable to me. Okay, you should, I think there is a comma there already. Yes, comma is there. You should stop there. Have you what I told? यहाँ पे comma है. Correct? Now, do you find one comma here? Right? Stop there. Slide stop. It is profitable, but still it is unfavorable to me, because if there is no such contract, I would have sold to you only at the market terms. If I had given, no, I would have got a good amount of money. Correct? Right. Now, listen. P value is the off market component. Off market component in the sense market rate. If I take it, na 3,000 rupees, I would have got what? If I cancel, I mean, if I off market terms means what? If I do follow the market, I mean market rate may if I had given, correct na, because of which what is that it will happen, 3,000 rupees I am making a less profit. Can I say, if I continue with the contract, I will be getting 3,000 rupees lower profit in the remaining 3 years of time. Have you understood now? Why you are getting less profit? Correct, because you are already existing price was a cheaper rate. Already you have that date, it may be fair market value, but 2 years before our rate was right. Now today rate is market rate will be fluctuating. Correct na? So, but your rate was fixed rate compared to market rate to 3,000. If I continue with it, 3,000 rupees is a loss. That's all. If I cancel it, 5,000 rupees is a loss. Why? Because penalty is there. Agreement is already there, na? Correct. So there is no carrying amount. Yes, obviously in the books of account, is there any carrying amount? No carrying amount. Is it a lawyer provision we made? No provision. Correct. Now, whenever the purchase happens, we'll purchase it. Whenever we sell the goods, we'll book the sales and that money will come back. With respect to this agreement, we have not made any asset or liability in the books of account. Are you getting my point? What is this agreement for? Sale of goods by P company to S company. Agree or not? For that, do you record journal entry? Today I enter into agreement. I will sell you goods at 10 rupees each. Correct? I will write agreement. Will I pass journal entry? I will not pass. Will there be an asset or not? No, nothing will be there. When I sell the goods, I will pass entry. When I get the money, I will record the entry. That's all. Correct? I hope you understood. Right. So, now what is that we are trying to tell? What is that? There is obviously there is no carrying amount in the books of account. Now out of this loss, which is lower loss, my dear, to you? If it is a general person, what do you do? What is your answer? Would you like to continue with the same agreement or would you like to cancel? Continue. Why? If I continue, I will get a loss of how much? 3,000. If I cancel it, 5,000. Anybody will select whichever is lesser loss. Are you getting my point? So 3,000 is a loss. Are you getting my point? So now what is that? The following journal entry that should be recorded. What do we say? But as part of now the question kya hai, sir? What is the question? Once you acquire this company, correct now, once you acquire this company, what will happen? Agreement only doesn't exist now. Where is agreement? Agreement cannot be me with me only, na? I cannot have agreement with me. So automatically agreement will be closed. But by acquiring this company, are you getting an advantage of 3,000 rupees of loss also or not? Advantage in the sense you don't need to pay. Hello, correct? So at the same time, suppose you are the one common sense question I'll ask you. You are the sellers of the shares, acquiring company shareholders. Are you getting my point? Now tell me, I am the buyer. If I say I am giving you 1 lakh rupees to purchase the shares, agree? Right? Are you happy? You are not happy with this actually. You will say, what about the existing agreement? Existing agreement say, are you getting a benefit of 3,000 rupees or not minimum? Hello, correct? Yes or no? If same agreement, if you had with another party other than me, is it a beneficial 3,000 rupees to you or not? selling company को beneficial, parent company को loss, because we already entered into an agreement at a fixed price. I have to sell you at the fixed price, correct? If you are getting the same item from other party, market rate से कम rate में मिल रहा है, so you are getting a 3,000 rupees benefit. Now are you foregoing 3,000 rupees because of entering into this agreement or not? So don't you expect 3,000 rupees from me? You will expect 3,000 rupees from me. Are you getting my point? That other way around, what we can tell, out of 1 lakh rupees what you gave it to me, इसमें 3,000 rupees you gave it to me for cancelling the old agreement. Cancelling means not literally cancelling. The benefit of 3,000 rupees you have 97,000 rupees is only with respect to purchase consideration. That's all. That is the matter here. Okay. So loss on settlement karke, okay, consideration transferred, whatever we'll say. So end of the day, yeah, here that continuation is not there. If you had given, correct now, if you have given PC, and don't say PC, we have given 1 lakh rupees ऐसा बोला तो ये 1 lakh rupees में 3,000 rupees is for this provision के लिए, getting my point, and only 97,000 rupees will be considered as a PC. This will be taken for the calculation of goodwill. This will be taken for the calculation of goodwill. 97,000 only you are supposed to take it. Right. So that is the important point. Okay. Can we go ahead? Right. Yeah. So now contingent liability related. Yeah. Now we have some few transactions are there. If you catch these transactions, then it will be done. Okay. Contingent liability, we already spoke. Correct. Now, even though there is no probable future economic benefits outflow, but there is a still present obligation arising from the past event exists, still you have to recognize it at fair market value. Karke we wrote it sometime before, correct na, which, right. So there is a present obligation arising from the past event, right, even though there is no probable future economic benefits outflow. It is a contingent liability for the acquiree, but it is a liability at fair value for the acquirer. That is what we have spoken. Okay, it is a contingent liability for the acquiree, not for acquirer. We should take it at fair market value में लेना पड़ेगा. Numbers will be given by them. Okay, done. Next, income taxes, my dear, the deferred tax calculation you are supposed to do, right? As we said, yeah, assets are going to come into my books at what rate? It will be coming at fair value. Correct na? What is the book में से example? The asset is equal to 1,000 rupees, but the fair market value is equal to 1,300 rupees. ऐसा है. Are you taking a new number? 300 rupees extra are you taking? Correct na? You are taking more 300 rupees means what? You are expecting more fair future economic benefits. Money will come 300 rupees excess. Means tax liability you are supposed to create na? Then automatically deferred tax liability you are supposed to create. And when we explained Ind AS 12 also, correct na? Goodwill will not create deferred tax liability, but on all other aspects of this we will be creating deferred tax asset or liability. Hello, understood? Right. Sometime what happens, subsidiary has huge losses. Kya bola? Subsidiary has what? Huge losses are there, right? But when you acquire the other subsidiary, what will happen? Our loss will be, suppose it's a merger. Merging is going to take place after the acquisition. Means that S company will no more exist. It will be combined with our company. Are you getting my point? Under the circumstance, that losses can be carried forwarded by me. Yes or no? It can be, correct. I can take it. Suppose I have got profits. Parent company has huge profits. Subsidiary has business losses not set off so far. Correct na? So I have got 100 crores profit. There is 40 crore rupees loss is sitting. If I merge the companies, what will happen? 100 minus 40, that's on 60 crores only I will make a tax. Understood? But with respect to this, there are some rules and regulations are there. Okay, if your company separately, if it is a merger case, it will come. If S continues as a S, if S continues as a S, if there is a shareholding pattern more than 75%, if changes, no, क्या बोला? 75% of the shareholding if shifted to another party, then whatever the carry forward losses are there, all will be zero. And income tax mein rule is there. If you are acquiring, you understood my point. E company mein I got 75% stake. They had how much huge losses are there. Are you getting my point? That time I will not be able to, I mean, anyhow, it's a separate independent company. This is separate independent company. What I was talking is a merger. Merger means what will happen? Legal existence of a company will not be there. It will be coming under my name. Under that circumstance, you can take it. But our company separate, my company separate. But I have a stake. If the stake is crossing more than 75%, what will happen? Whatever the losses, business losses so far you have carry forwarded, that will be lapsed. That will be lapsed. Subsequently, if you get lost, that will be taken care. But existing wala will be lapsed. Okay, some rules when you are making a deferred tax, you will be calculating deferred tax. No, correct na? Deferred tax means that company ka losses you cannot take deferred tax here because it will be lapsed. That also you need to keep it in mind while writing the journal entry. Okay, income taxes is that point. Employee benefits normal. Employee benefits normal. There is, I mean, as per Ind AS 19, actual valuation and etc. is supposed to be taken place. That's all. It will no separate thing. Okay, indemnification asset. Yeah, what is indemnification asset? If the subsidiary shareholders or somebody is going to indemnify you, means a guarantee indirectly, correct na? Will promise, will get you this much, correct na? Suppose sometime what happens, there is a case against my subsidiary company, correct na? And department is asking, SGST department filed a case against you. Department is asking 10 crore rupees you should pay. Kya pay karna? 10 crores you should pay. Are you getting my point? Right now you kept it as a contingent liability. That present value mein will take it as a liability mein will record it. At the same time, you people are the shareholders of this company. Now you are telling, now I am arguing, your 10 crore rupees is there, why should I pay you? Suppose if you lose the case, 10 crore rupees gaya na, karke because I am buyer, I have to handle the case from today. Correct, now I am discussing. Now what you people tell, don't worry sir, if there is any such loss, no, I will pay for that, from our pocket we will pay. Are you getting my point? If something, the case goes unfavorable to you in the future, after we left also, are you getting my point? Nothing to worry, we will pay you the loss. Correct now. What is this called? Ade indemnification. What is it called? Guarantee you are giving, which is nothing but indemnification. Now, one side, what am I doing in my balance sheet? Acquirer's balance sheet, I am recognizing the present value, I mean fair value of the contingent liability, I will recognize as a liability. At the same time, to the extent you gave me the indemnification, correct now, that I will recognize as an asset. Are you getting my point? These points, no, they will not ask separately for 4 mark, but these points they will keep it in the big sum mein 1 point they will keep it. Okay na? So what are you supposed to do? Indemnification asset is there, means what will happen when you are recording like asset account debit at fair market value. Here also indemnification asset account debit some X number you are supposed, it is also asset to you na. So when your asset is going up, that means automatically goodwill value will fall down to that extent. And 2, what is that contingent liability ka fair market value must have noted here. Yes or no? That is where you need to be careful. Fine. Right. Next, reacquired rights. Yeah, this is anyhow at the fair market value only we are going to record that also. Nothing specific or, yes, there is a small concept but nothing great. Yeah. Listen, this one is assets held for sale. Yeah, assets held for sale. What do you do, ma? Right? Here it is not cost minus. Okay, sorry. Yeah, this is correct only. No, assets held for sale. Listen carefully. Normally, right, when the standard is 105 may assets held for sale. Subsidiary company books may it was asset held for sale. Agree na? Subsidiary company books may assets for held for sale. How have they recorded? They will be recording at FMV minus selling cost mein they must have recorded. The standard our 103 says what? All the assets, whether it is held for sale or not, separate sentence is not given. Okay. Every asset should be recorded at what? FMV karke, that is what understood. It should be at FMV, not minus selling cost. Hello, are you getting my point? This is a small exception to that rule of FMV. If asset held for sale in whose balance sheet? Subsidiary. And you also what you wanted to do? You acquire, but you also want to sell off. You don't want to continue with the same asset. If you wanted to continue, then it would have been gone to PPE directly. You also wanted to correct sell. Now, even correct under that circumstance, you will also continue to measure it at FMV minus selling cost, but not at fair market value. Our original rule is FMV. Correct na? But there is a small exception if our intention also to continue to sell. I hope you understood. Still 105 rules only will apply, not 103 rule in the given circumstance. Okay. Yeah. This is something they have, correct na? They have already asked this point. In the questions they have kept this point. Have you heard? SBP, share based payment related to business combination. What will happen, my dear? Share based payment related to business combination means? Yeah, once I think this is done means majorly almost all are done. SBP was the only major one. Okay. Say you already may be having a correct number. SBP is there. Subsidiary company ka SBP is there. Listen carefully. I am the subsidiary company. You are all my employees. I already promised you. I will give you 2000 share, 3000 share ऐसा करके. I already gave it and I already told you. You continue to be here करके बोला. Now what will happen? The problem can be something like this. I correct now. Holding company acquired only 55%. You understood? So now a subsidiary company issues more number of shares to outside party other than to the parent company, then my percentage may fall below 50%. Yes or no? It can fall. Or that is one reason. That's why what can we do? What can we do? We may, there are too many ways it can happen. Too many ways in the sense what? We'll cancel the old SBP and give a new SBP. Maybe my parent company का दे देंगे, आपको क्या problem है? Correct ना? Subsidiary से बच्चा. Parent company means value will be more, no, my dear. Agree or not? Alright, like that it can happen. Or existing agreement only, okay, I'll give you shares, not a problem. I'm fine for losing the shares or something, correct, no? But I'll extend little bit. Maybe earlier 4 years I asked you to stay, but I'll give you more number of shares, I'll give you, but not for 4 years. You have to stay for 1 more year. Correct, no? So many different types. Situation oriented, how to handle that I cannot handle. It is already understood by them. I just need to do accounting for this. Done. Now, what is the problem here? Problem is, out of the total consideration, okay, na, how much is related to before acquisition, how much is related to after acquisition services. Okay, our bifurcation is what crucial. Okay, if it is related to before, already people have served. Correct, na? So this will be considered as part of business combination. People are going to serve. That is a employee benefit expenditure. This is a employee benefit expense in the future. Are you getting my point? Right. E point was given in the 1 or 2 questions which were asked in the exam in the past. Okay, right. Too many, or 2-3 probabilities are there. One probability is what? Generally repetitive. Okay, from exam point of view also, first probability is what? Asked number of times. Okay, whenever there is a question means there is only first probability they'll ask. Second probability, rarely touched, not touched so far. Fine. So at least learn the first probability correct. ठीक से पढ़ो, then the job will be done. Okay, right. So first probability observe करो. Right. This point, the following diagram brings you the better understanding. Yes, agree. right? I have given one small question also, my dear. Up to this question we will solve it. Okay. First, would you like to just read this for a minute? Read it. I'll obviously read once again along with you. I'll explain it to you. Here, don't dig too much. Okay, from examination point of view, logically, for this point, I will tell. Suggest not to go. Okay, yeah, you will get that, but sometimes what happens, after spending so much, what do you understand is this much? Then I will also say not required. Okay, if it is a regular class, that is different. Last minute, not required. I hope you understood. Yeah, so that's why some formula, one method, what by what, are they what by what only you apply. Got it? Right, that is more than sufficient. Now, the period for which services have been provided by the employees before the date of acquisition. Okay, now what is this, my dear? This is date of acquisition. Correct. Now, A is the period, right? People have already served. Agree or not? Next, the original vesting period of the acquiry awards is B. This is original. Originally, we asked them to, correct. Now, from here to here, you should work. करके बोल दिया. In between only acquisition took place. Agree? Next, post combination vesting period, if any, for the replacement of new awards. Correct. Na? What is that we are asking now? Correct. Now we acquired you. Correct. Na? Now you please work till this time. That means extension is there. Earlier I must have asked you to work for 3 years or 2 years. Now I am making it 3 years. Maybe awards may be more. Awards may be parent company shares I will give you. Anyhow you worked 1 more year, you work and take it. Now, the greater of the total vesting period, A or C, sum of A plus C. Okay, yes, sum of A plus C means what, my dear? A is the old period, C is the new period. That means nothing but from here to, correct now, from here to here you are supposed to consider first thing. Correct now. And the original vesting period is B. Are you catching the point? Right. Whichever is the greater, you are supposed to consider. Where to consider, how to calculate, I am going to explain. First, have you understood which line represents what? That is first level of understanding. Next, calculation formula, how this will be one part of the main, one of the question which was asked in the exam also, I will just show it to you. Then you will be able to understand, oh, like this it will come. In exam, it will be straight and simple. Okay, not like too complicated. Right, even if they want to complicate, I told you one small formula if you remember, that's all. That is more than sufficient. Now look at this, some concept capsule. Please read it carefully. Okay, Green Limited acquired the Pollution Limited. Okay, Green is the acquirer, right? As part of the arrangement, Green Limited has to replace the Pollution Limited's existing equity settled share based payment. Okay ना? Me your company का cancel करो, मैं company का दे देंगे. Agree? Parent company का मिल रहा है आपका. Are you getting my point? Parent company may be listed company. Shares if you get whenever you want, you can sell it off. Yes or no? Correct na? So that's why it is beneficial to anybody. Right. The original awards specifying the vesting period of 5 years. Original award is for how much? 5 years. That means this is 5 years. Correct na? Right. We'll go back front and back all the time. At the acquisition date, employees have already rendered 2 years of service. That means 2 years already people have completed. Do you agree? Correct. As required, Green Limited replaced the original award with the own share-based payment awards. Correct. Na? Parent company ka de rahe. Under the replacement awards, the vesting period is reduced to 2 years. Okay, from the acquisition date. Right. Actually, you should have worked for 3 years. Now, what are we doing? You work for 2 years only. Correct. Na? From the date of acquisition. Read it. The vesting period is reduced to 2 years from the date of acquisition. 2 years. Agree. Now, the value of the market based measurement, okay, fair market value of the awards at the acquisition date are as follows. This is one kind of what? Retention strategy. Correct na? Be with me. You already worked. You don't need to work. Earlier is 5 years. Now I am making it 4 years in total. Correct na? So obviously employee also will think what? Better to continue also. Correct na? Sometimes what happens, just by listening to the It may be fact, it may be the other way around. By listening to the, I mean, if you listen from morning to evening, other reel you have seen, correct na? What is the negative, 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 sunke, correct na? Mind also will become negative. Yes or no? It will have impact, my dear, obviously for any human, if you are a human means impact will be there, correct na? Right? So that is where you need to be. Yeah, fine. So here you listen carefully, because of this, I mean, negativity, what will happen, ma? Teams and team number of people will jump just like that. I was part of Satyam company restatement audit. Satyam, you heard? Long it is no more now. Correct na? That is nothing but Tech Mahindra it became. Satyam got acquired by Mahindra and Mahindra. That is Tech Mahindra company. That is a reverse acquisition. Tech Mahindra is a chota company. They issued more number of shares to Satyam company shareholders, actually speaking. Okay. But that day Ind AS is not applicable. Okay, chodo. Right? So in that companies also, na, that rumor, I was part of Deloitte those days. So I had been there for the restatement audit. Means some numbers are not there, some fraud was there, correct na? Fraud audit, you think that way, okay? Is it really numbers are fake, correct? We need to audit, and we are, so Deloitte used to supposed to sign and all done. That time also, because of the rumors, what happened, Tech Mahindra will not be like employee friendly, correct na? They'll throw you out. Before they throw out, only some guys left. Yeah, it happens. It happens. I mean, information spreading will have impact. Some guys may be like cool and control, it's okay, let it come, that time I'll go. Correct. No? Some guys will say, no, why we heard something negative about Mahindra, so let's leave. Correct. They left. So many higher level officials, below guy goes means nobody bothers. Easily replaceable. Correct. No? Some top level also will go. That happens because of so many problems. Right. Original awards worth is equal to 500. Correct. But now you have replaced with your own share based payments, correct na? So that's going to be worth of 600. No excess, correct na? Now as of the acquisition date, all the awards are expected to vest. Nothing is going to lapse or something. Determine the pre-combination service and the post-combination service with journal entries in the consolidated financial statement. Okay, right. Listen carefully. Pre-combination service. What is pre-combination service? Yeah, read it from here itself. I have given, I don't need to go back. Yeah. First read it carefully. You will catch it. Again, I will read and I will tell you. You read the paragraph? Right. Now listen carefully. I will read once again as I said. So the total value of replacement is going to be bifurcated between pre-combination and post-combination. Sir, how does it impact? That question should come to your mind, must have come already. Right now. What is the journal entry you record when you are acquiring the company? Correct. Now you will be recording 2 equity share capital. Correct. Now that is purchase consideration. Correct. 2 liability. Agree or not? Right. 2 NCI. The amount what I tell, listen carefully. The amount what I tell pre-combination, that will be recorded as ESOP reserve or SBPPR. SBPR. A number pre-combination E number I will keep it here. Why? Already they have served my subsidiary company. So it will be sitting in the SBPR of the holding company. When if you pass journal entry literally, you should be crediting SBPR to the extent of pre-combination. Now, by passing this, isn't it your goodwill number goes up or not, my dear? Is a consideration given, even though you have not given today anything. It is a you are giving value and you are paying it for them. Have you understood? ऐसा SBPR आ जाएगा, आ गया तो goodwill value will go up. Understood? So how much should I consider? Earlier SBPR is sitting in the subsidiary books. It is nothing to do. Now I am passing journal entry in the parent company on the date of acquisition. That's why matter is important. Have you understood? Right. Now listen. How much amount I should do it? Listen, carefully listen now, you will be able to catch it. As on the date of acquisition, correct? The fair value of the original award, 500, correct na? Will be multiplied by the service rendered up to the date of acquisition. Yes, 2 years already served. Divided by the greater of the original period or the total period. Okay. Come here, greater of original period is how much? This is original period. How much is original period? 5 years. Next, what is it telling? A plus C also we are supposed to take it. What is A plus C? A is equal to how much? 2 years already written. And C also we are supposed to write only for 2 years na? You are asking them to work for now. 5 or 4, correct na? Whichever is higher, correct na? Whichever is higher. So, a number you are supposed to take it. Suppose if they ask not here, you should work for 6, means 6 years only will come. Are you getting my point? Right. So, 500 into 2 divided by 5. E 200 rupees will be considered as P combination service, will be considered for purchase consideration. That means it will come as a ESOP reserve. On the date of acquisition, when you are passing the journal entry, it will come to ESOP reserve, because of which your goodwill will go up. Now I hope you understood. Some clarity. What is the impact? Because generally some students na, they will understand as understood, but impact kaisa ho jayega? What journal entry will come? Correct na? That linking will be missed. You know this, but linking is missing means useless ho jayega. Understood? But listen, whatever I say post combination, that time what do I record? Already goodwill calculation over. That time what do I record? Very simple na. Employee benefit no, not even employee benefit. Investment account debited to capital ESOP reserve में करेगा, because I am a parent company. I am a parent company. I am giving the SBP to whom? Subsidiary company. It is a group share based payment हो गया. Correct na? So what is the journal entry will record? Investment in, it's a deemed investment. The investment in the subsidiary account debit to again SBPR only will do. That subsidiary will be recording as employee benefit expenditure. Getting my point? Right. How the business combination takes place, accordingly it will happen. But if the parent company is replacing, then investment account debit to SBPR will come. Hello, understood? Our subsidiary only gives a replacement. Who is giving the replacement? Then also it will come to me. It will come to me only. Are you getting my point? SBPR will be coming. Now, post combination, yahan pe suno carefully. Post combination, listen my dear, always it is the new value is how much? You cannot take 200 is pre means 300 is no, not that way. That's why I am emphasizing once again. New value you are supposed to take. Which value you should take? New value. What is today value is how much? Actually today everything will be valued at fair value, not today. All the assets and all the liabilities fair value. Out of this 200 is pre, if I do it, that means 400 is the post combination. E post combination, correct na? E post combination will be done over the next remaining 2 years time में 200 ऐसा charge करेंगे. Are you getting my point? Yes, like this it is going to happen. Later employee benefit, if you are only replacing employee benefit, if the employee is serving you, employee benefit expense will come. If employee is not serving, it is going to be investment in subsidiary will come. The concept. Okay, right. Intangible assets we spoke, right? Whether it is recorded in the subsidiary books, not recorded in the subsidiary book, does not matter. It is going to be recognized at fair market value. Okay, and if it is a research acquisition, yes, this will be recorded at fair market value. Subsequently, whatever you have incurred,
Correct na? Subsequently, whatever you have incurred, if it is related to research, it will be charged to P&L. If it is related to development, subject to 6 conditions, it will be capitalized. That is same concept, nothing new. Leases may, you don't need, not something great, normal. If they have not recognized any lease assets or lease liability, then this situation will come. If they already recognized everything at perfectly, nothing major is going to happen here. Okay. There is one more concept called measurement period. Measurement period is what? Within 1 year from the date of acquisition. Are you aware of this by any chance? Means I'll tell you. Okay, right. So today date of acquisition, today date of acquisition. What is date of acquisition? Let me say 1/1/2025. I'll take it. Okay, na. Today are you supposed to pass one journal entry or not? You will pass. What is the entry you will pass? You need what all you need? Fair market value of assets. You need fair market value of liabilities. Correct? Na, fair market value of assets. You need fair market liability. You need fair market value of purchase consideration. You need fair market value of NCI in case if it is an option. Accounting policy you need. Agree na? Right. Maybe something you understood. Tentatively, what is that I said? Tentatively, you have got a valuation done by somebody. That guy told fair market value of so and so asset is equal to 200 करके बोल दिया. Hello, understood? Based on 200 rupees, you passed a journal entry for goodwill. Within 3 months or 6 months, whatever it is, within 1 year time, okay, now within 1 year time, we understood that our value 200 was not correct. It is supposed it would have been 250. It would have been 250. They have done some small error in the calculations. They have, which is supposed to be considered at the time of valuation, they have not considered. Hello, understood? You understood na? Now what should I do? Adjust it with the goodwill. Now, okay na? Now 31st March 2025 आ गया. Now some asset has to go up or asset has to come down. Correct na? Right. Our number, our 200 or 250 rupees number, you have to either increase or decrease goodwill, and corresponding effect should be given to either asset or liability. Okay, you have to increase or decrease the goodwill. Accordingly, asset or liability is going to be increasing or decreasing, whatever it is. But this is what, again, be very careful. The information, if there is an error in the valuation or if that was not correct calculation has happened, reference of something you have calculated, it's not the right way of calculation, something like that, it has happened on the date of acquisition. Subsequently, we understood that was not, then you have got a time to correct yourself. You can correct. Once, sir, after I got to know about this error after 1 year, very good, transfer it to P&L, nothing to do with goodwill. It should be transferred to profit and loss statement. Go transfer karo, my dear. Nothing will be there. Okay. Right. The subsequent measurement, contingent consideration ka we spoke. Contingent liability also in same fashion. Indemnification, all these things will be remaining same. Okay. One big sum, if I had kept it here. Reverse acquisition, I don't want. I told I don't want to take it. TCBCs, are they asking? Common control business combination? Common control business combination by chance? No, never, no. Normal acquisitions only have come. There is one more thing, common control business combination. Okay, exam point of view, considering the past, importance, considering the past. Obviously, nobody knows future. Okay. Common control business combination means, suppose, see my dear, H company is there. Okay, subsidiary is there. Subsidiary 1, this is subsidiary 2. Okay. E subsidiary has got sub-subsidiary 1. ऐसा कुछ है. Okay. Now what is that they did? They did some restructuring. Restructuring means now this company will sell the stake of SS1 to here. Earlier it was subsidiary of what? S1. Now it is a subsidiary of S2. But it was part of holding, my company, holding company, ultimate holding company mein, it is same only na? Yes or no? Correct na? So
since it is just group, may change is happening. Maybe sometime what happened, percentage may be changed, NCA may differ still. This is called common control business combination. What is it called? Common control business combination, because it was controlled by H before acquisition, it is controlled by H after acquisition. Okay, standalone financial statements of S2 also going by CCBC, going by CCBC. H may automatically CCBC will happen. Are you following my words? What did I say? Have you heard this or no? Never heard. Heard, na? Means what is CCBC may what will happen? Restructuring is happening. Now here all assets and liabilities will be taken at book value, not at fair market value. Okay, na? Right. Goodwill and all will not come, because everything you are taking at book value. I hope you understood. Right. That is the only one concept is there. From exam point of view, I don't think so. I don't remember like they asked sometime in the past. They have focused only on the main part of business combination, not on the CCBC is easy from the point view, of it is not a difficult concept actually. Okay, I think all the question, main question, if you look at the other question, no, this SBP wala what I was explaining, SBP wala question was already there. It was asked in the main question mein one paragraph mein they will ask. Correct, na? But they will tell that only one paragraph mein they will close it. You should be deciding 200 or 500 to 600 adella decide karke that you should have taken correctly into consideration. Okay, so with this I am closing Ind AS 103. Okay. With respect to consolidation, right, I'll take you to the consolidation standard. Just a second. Yeah, consolidated financial statements mein what do I follow? As I told you, first 25 questions are there. All these questions in this textbook, no, first 25 questions are just to decide whether you have a control or not. But that related questions are not there. Correct? No? They never asked. So it is time waste for you right now to revise it. Hope you understood. What is the definition of control? What is the de facto control? You understood. Sometime it will happen, amma. 49% is held by me. 50% is held by 1 lakh people. 51% is held by how many people? 1 lakh people may there. Tell me who is controlling the company? Me only controlling. Why means consolidating 51 people, everybody should come together and come opposite to me. They never come to board, they never come to AGM only. You understood my point? They never come to AGM. They never participated in the meetings or decision makings or something. I hope you understood. Then who has the control? Me. Correct. Right. Suppose today I have the control. Tomorrow what has happened? Some new company has come. They started purchasing shares from all the people. Now 1 lakh people hands me that has come down to 10 people ke aa gaya. How much it has become? 10 people. Consolidation of 10 people mindset is easy compared to 1 lakh people. Now I should say I don't have control. Understood? Last year I was controlling. Now today I am not controlling. So that is supposed to be reviewed on every year basis. And as I am telling here, right, basic consolidation, consolidated profit and loss, consolidated P&L they never asked, but consolidated cash flow they asked once. One time it was a bouncer. There is no doubt. Right, consolidated cash flow statement pucha. No, I mean correct na. You must have forgotten cash flow preparation first. Agree? Right. So now suddenly if they ask consolidated cash flow statement, obviously went above the head. Yes, for anybody it will go above the head. Right. So That is the point here. And again, basic consolidation rules, let us revise it, but not every step. If you want me to go through, I'll go through the steps, but I told you, na, every teacher does consolidation in their own fashion. Correct, na? Better you follow that. If I tell my steps, na, by mistake, if you feel like, oh, this is more easy, then your mind will, that is, I mean, maybe easy, maybe difficult. Both are correct, na? If you are unlucky, then it will become easy. Possibilities, correct, na? Then unnecessary mind kharab ho jayega. That's why I don't want to get into step 1, step 2, step 3. I do not want to explain. But okay, procedure, basic procedures I can explain. Correct, na? What are the basic procedures, my dear? Basic procedures are what? We will consolidate line by line. Assets, liability, income, expenditure, everything we do consolidation. Correct, na? Right, all line by line we'll do. Next, as usual, this is the basic thing which everybody learn on the day 1. Correct, na? First minute only we'll learn what? We'll knock off. Our investment in subsidiary will be knocked off. That's why we are bringing the assets and liabilities of other company. Agree or not? Exactly. So next, yes, obviously goodwill will come. Gain from bargain purchase, that is nothing but the capital reserve, which we spoke sometime before, 103. That is very rarely possible circumstance, may come. In examination, anything can come, whatever comes, you follow it. Done. Bifurcate the subsidiary profits between the pre-acquisition and post-acquisition profits. Correct. Now, why means pre-acquisition is considered for the goodwill purpose. Correct. Na? Right. Post-acquisition is considered for the, I mean, reserves that will be part of my share. I will take it in my reserve, and NCI will take their share to the profits. Agree, na? Right. Determine the NCI as on the balance sheet date. For that, first NCI you must have measured on the date of acquisition plus or minus the share in the subsequent profits. Correct. Share in the subsequent change in the reserves is the right word. Right. Done. Eliminate the full intra-group transactions, intra-group balances, cash flows, everything you are supposed to eliminate it. Correct, na? Because you are giving consolidated financial statements means what? Group is one separate legal entity करके assumption ले रहा है. क्या ले रहा है? Group is a separate legal entity. When group is one entity, then obviously subsidiaries and all not entities. Yeah, if there is a transaction between me and my subsidiary, that I am going to eliminate it. Hope you understand. Yeah, we are going to eliminate. We will not take that as a loan given, loan taken. Debentures issued by parent company, purchased by subsidiary. Subsidiary issued parent company, purchased. All will be knocked off. Okay, right. And because of this, sometimes deferred tax asset or liability also can come up. Because what do? Unrealized profits can be there. What will be there? Because of this unrealized profit, deferred tax asset will be coming in the books of parent company. Okay, right. That will be discussed. That must, I mean, we have not discussed, but you must have read it under Ind AS 12 May. That one small point can come. Okay, right. So you have to take care of deferred tax arising because of the unrealized profit is the only circumstance. Rest of the things normal it will happen. Okay, done. So intra-group losses, grosses may indicate impairment that requires recognition in the consolidated. Right? Listen, one question has come recently. Okay, some people were asking. See, in the standalone financial statements may, okay, na, standalone financial statements may, I have investment in subsidiary karke some X number I have kept. But there is an impairment. What is there? Impairment. I mean, that value company is making losses, they are making. Right? Say example, this is 1000 rupees, I'll keep it. But recoverable amount is hardly 600 rupees. That's why what do? Standalone mein what do, my dear? 400 rupees I will book the impairment loss. Where? Standalone mein I'll book it. Correct na? But when I am doing consolidation, no, 400 it should not continue. What are you supposed to do? First 400 reverse karo. 1000 ही लिखना. Got it? Why? Whatever their loss is already coming into my consolidated financial statements में आ रहा है ना. I'm taking my share of loss already. Standalone mein I will be recording it at Cost. Cost is old, historical cost. So when I consolidate that company, if they are making losses, huge losses, I have already taken my share of it. So I don't need to take once again impairment. Okay, right. So fine. Here recognition, derecognition, anything can happen depending upon the circumstance. Indirectly, directly. Deferred tax wala we spoke. Deferred tax can come from the because of the elimination of profit or loss or unrealized profits or losses, something can come up. Okay, right. See, we do not record any journal entry for the above steps. Actually, I mean, we do not maintain the separate books of account for consolidation. That's why we don't record a journal entry. But as if I write the journal entry, what will come? Correct. Now, that I have to consider it in the while preparing the consolidated financial statements. Correct. Now, when you go by journal entry, then perfect impact will be there. Like debit, I will do, credit, I will do. I'm increasing, I'm reducing, or I'm reducing, I'm increasing. I'll have the clarity. Otherwise, if you just do like that, nah, it will not work out. Okay, right. So only for understanding purpose, we will be recording some notional journal entries that is going to be a part of our working. That is fine. Okay, these are all step number 1, step number 2, step number 3. Correct, na? All these are step number, right. Do you want me to look at any specific thing, my dear? Non-controlling interest we spoke. Correct, na? Initially, it should be measured at fair value or the this one. Next, acquired during the year, acquisition of interest without consideration. We spoke already all these things. Cost or investment, correct, na? Deferred consideration, contingent consideration, share exchanges. Any specific thing that you wanted me to look at? Two small points. Tell me. Hmm. Company acquired in between. Okay. After acquisition, dividend has come to me. Okay. Holding company will recognize whatever they received as an income. Hmm. Hmm. Adjust dividend for what? With what? Reduce from investment. Hmm. Yeah, you show me the book because I didn't get I didn't understand question. Okay. Next question. Additional depreciation, I can give immediately clarification. Now I can tell additional depreciation what she is talking. Correct, na? Right. Listen carefully. This is on the date of acquisition. Subsidiary company का balance sheet में okay say property, plant and equipment 1000 rupees is there. What is 1000 rupees? That is the book value. But on the date of acquisition, the property, plant and equipment, what is that? The fair market value I am supposed to consider. Yeah, fair market value is equal to 1600 rupees. Correct, na? But for 1600 rupees, do you think that subsidiary will be recording journal entry? Subsidiary will not pass any journal entry. Not necessary, because if you want to make it that, what will happen? Subsidiary should be following revaluation model. Agree or not? Subsidiary says I am following cost model, why should I change it? Subsidiary will not pass any journal. Even parent also will not ask you to do it. Okay, so now are you getting my point? So, but for your consolidation, but for the data of acquisition, when you are calculating the journal entry, you will say PPE, property, plant and equipment account debit. You will be recording at how much? 1600 you will record. Hello, correct? Today on date of acquisition 1/1/2025, you have recorded journal entry of 1600. Correct now. Suddenly on 31st March 2025 on the balance sheet date, will it be 1600 only, or 1600 minus depreciation will be there, but it will not go back to 1000, no. But when the subsidiary company gets you the financial statement for consolidation, they will give which number? 1000 number only they have 1000 number minus depreciation they would have given it to you. Are you getting my point? Subsidiary gives you the trial balance or financial statements with all their numbers of 1000. But you have to consider how much? 1600, correct na? So 1600 right now. So what are you supposed to do? Is 1600 mein 600 is jasti? Correct na? What is the remaining life of the asset? Remaining life of the asset is 10 years example. Then what are you supposed to do from the date of acquisition to the balance sheet date? Correct na? From the date of acquisition to balance sheet date, how many months are over? Only 3 months are over. Then what are you supposed to do? 600 divided by 10 years into 3 months means 0.25. Correct na? So that will come to 15 rupees will come. Okay, our 15 rupees will be additional depreciation you should charge. Additional depreciation you charge in the consolidated financial statements mein 15 rupees karke you are supposed to charge. Why you are charging? Because what he charged is based on 1000. Correct na? But what you considered 1600. 1000 ka already depreciation is charged by him. Correct. Now what should I do? I should pass journal entry for how much? 15 rupees ka journal, 600 ka journal entry I would have already passed, assuming, correct na? 600 ka I already passed in the books. 600 should be charged over the period of time or not, correct na? So now tell me in the consolidated balance sheet, E1000 is as on which date, my dear? 1/1/2025, correct? E1000 would have become on 31st March 2025. That must have become to 975. How? 1000 divided by 10 years, 100. 100 ka 3 months means 25 rupees. So 975 would have become, correct? Right. But actually it should have become how much? Now what do? I can write it PPE. Your number of 975 I will take it, plus I would have initially on the date of acquisition I would have added 600 rupees minus additional depreciation of 15. E number is supposed to be there in the balance sheet. Okay, ulta, if it is 1000 place mein, if it is only 600 rupees, I mean not 600, some value is reduced, fair market value is lower than the book value, correct na? Value, I mean value can be plus, value can be minus. Same additional excess, I mean you will do the reversal of depreciation, you will be doing it on this day. You understood reason, right? Initially I would have increased my assets by 600 extra, correct? In my books of consolidation purpose, your E600 is entry only in the consolidation purpose. That is not recorded in the tally. Subsidiary में भी record नहीं करेंगे, parent में भी record नहीं करेंगे, but it is only in the tally, correct? No, sorry, tally. Excel में will do it. Only in Excel will do this. Agree? Right. You tell me the other one also. We'll clear that point. Suppose this is dated which date? 31st March 2025 I told. Suppose my dear it is 31st March 2026. Then what you would have done? Whatever X number they gave plus I must have added 600 minus 15 for the 3 months of time minus 60 for the next 1 year time. Correct. Now from the date of acquisition to till date depreciation you have to reduce it, then only it will match. That's why first you need to be aware of which date of acquisition, what is the date of balance sheet. From that date to because it's a balance sheet, not a P&L. P&L will talk only for the 1 year ka impact. Agree? Right. You get me the other question, we'll handle. Do you have any other point, something like that? Yeah. Let me explain. Okay, he is asking on the foreign subsidiary related one small point he is asking. Other than that, majorly we have covered. Okay, majorly covered in the sense normal consolidation steps. If I tell no, I told it will be more of confusion. Whatever your prospective teacher has taught, Follow that. Okay. Now in the last minute, I don't want to confuse you. Right. So suppose if this is not for an examination point of view, what the question he asked no is not from examination, it is out of syllabus. Okay. Suppose if you have a foreign subsidiary, what do you have? Foreign subsidiary you have, correct na? And Indian parent company, holding is Indian. Yeah. Then how do you do? That's what your question, correct na? All normal procedures of elimination of investment and foreign currency intercompany balances, transactions, all are normal. But when you get the subsidiary company ka balance sheet or trial balance, basically trial balance, correct na? You will get one trial balance. E trial balance mein what will happen? There will be assets, correct na? There will be liability, there will be equity. TB includes all. TB mein income, TB mein expenditure, all will be there. Correct? Right. We should, in simple words, I should say, if you remember the concept, we should consider this as a non-integral foreign operation. What is this? Non-integral foreign operation means assets and liabilities co, my dear, you have to consider balance sheet date rate. Balance sheet date rate, whatever the closing rate in simple words. You have to use the closing rate and you have to convert it into rupees. Okay, all assets and liabilities same. There is no monetary, non-monetary, nothing. Everything will be using the closing rate. You will convert it, right? But with respect to equity, there is a small difference is there. Okay, with respect to equity share capital number, we'll use the rate on the date of acquisition. Rate on the date of acquisition will apply. When you have acquired long ago, our rate will take it. Again, here also what will happen? Reserves and surplus are there. Correct na? Reserves and surplus should be bifurcated between two. One is what? Reserves and surplus on the date of acquisition you have to determine. This is the post acquisition profits you have to determine. For this, rate on the date of acquisition, like ESC plus post acquisition ko rate on the date of acquisition you have to apply. Post acquisition ko what do you do? Post acquisition number, the concept is very simple. You must have consolidated from the last all these years, no? Yes or no? A number only directly you can keep it. You don't need to convert it into a separate rate. What I mean to say, yeah, you say example, I acquired the company in 2024. Correct na? So then you must have consolidated on 31st March 2025. Assume now you are in the 31st March 2026. Agree na? Right. So 2026, current year, the number is a P&L number. Is it coming from the current year only? Yes or no? Current year profit and current year mein what will happen? Income and expenditure will be using the average rate. Average rate of what? 2025-26 will apply. Income minus expenditure, correct na? Income minus expenditure only my retained earnings. That is nothing but current year retained earnings. Is it a post acquisition number? Yes or no? Correct na? Next, at the same time, last year also you must have consolidated. Consolidated or not? You consolidated. That means last year P&L may what is the profit of the subsidiary company? You already derived na? Actual number you know na? Adhe number you should keep it. Don't bring the fair value. Forex rate implementation you don't need to be, because you already converted in the last year and brought it into rupees. Last year average rate you already taken na? Average rate after converting into average, what is the number? Number only you are supposed to continue. Don't need to turn once again separately, not required. Because that is nothing but from the date of acquisition you must have already consolidated. You already know the fact numbers. Numbers only you should take it. That's all. And after doing all these things, pakka there will be a difference. Our difference will be transferred to FCTR. FCTR will be between the parent company portion will go to parent company, NCI portion will go to NCI. Parent portion parent, NCI portion NCI. Correct, because I may be having only 80% stake. 80% will go to my reserves, 20% will go to NCI को ऐड करेंगे. That's how we'll do. Practically also, theoretically also, that is the same way. In examination, they will give, if they don't, this concept only they have not given, and from the date of Ind AS to till date, they have not asked such kind of question out of syllabus. Okay, na? And such material may no such question also is there. Understood? Again, cross holding something is that also they never asked. That's not there in the syllabus. Okay. Normally, practically also what happens? Cross holding means parent company shares are held by subsidiary company. Before acquisition, we bought it. You got it? Right. What will happen? No, generally, frankly speaking, we'll buy back those shares held by the subsidiary company. Will buy back shares means what? Subsidiary company को offer दे देंगे, आप पैसा दे दो ना, that's all. Then problems, that is how we'll resolve the issue. I'm controlling you. Again, you will have some stake in me. That is not, a formula you have to make it, and you have to do so many things you are supposed to. It won't work out like that. That's why we'll buy back the shares. Practically what we'll do, we'll buy back the share. Then holding khatam. Holding khatam, the normal consolidation will happen. Rarest possible circumstances, somewhere it will happen. That's why it is not there in the syllabus. Before also not there, after also not there. After Ind AS also not there, before Ind AS also not there. Okay, but there is some concept in the theory. Only theory. Practically, I have not seen such kind of company so far. Yeah, maybe there somewhere. Fine. Right. Any other specific point? Consolidation, step down subsidiary. Holding is there. Subsidiary is there. Subsidiary is there. Step down subsidiary. Who can take exemption is this company can take exemption. They can do only standalone. They only SFS they can prepare. They don't need to prepare subject to condition. Subject to what? E company is not a listed company. Not in the process of listed company. Correct. Okay. Say example, I am holding only 80%. Somebody is holding 20%. Then I have to take a permission. I have to take a permission of this guy also. Next, my company numbers are added in the holding company. E holding company should make the financial statements available to public. That's all. These are the conditions. If you satisfy the conditions, then S does not need to prepare consolidated financial statements. Now, what is the question? Now, what do we do? Normally, what we'll do? First, we'll do S plus SS, we'll do it for the consolidation of E company. After consolidation, we'll consolidate. That is a normal method, better method. Directly also we can do by applying the percentage. But in general, preferable is what? We'll ask first S to consolidate. We don't present it. Only the calculations will happen. Excel numbers will happen. Or we only do it. At holding level, we'll do consolidate. Our consolidated number, I'll take it. My share, I'll take it. That's all. Yeah, consolidation is every entity. Yes, whether it is partnership also will consider, LLP also will consider. LLP also can be a subsidiary, partnership also can be a subsidiary. Every entity will be considered. Control do you have are not important. No, you have to prepare. You have to prepare as per Ind AS. But partnership, they will not present anywhere. But for consolidation purpose, your number should come to Ind AS, then only I will consolidate. Then only I will consolidate it. You have to get into. I am going to prepare maybe next week. One LLP company, that parent or investor is sitting in Korea. They wanted IFRS 3 years balance sheet. They wanted. Proposal is going on. Okay. If it comes, it's LLP. But you see, LLP and E companies ko, it is voluntarily also you are not supposed to follow Ind AS. It is only for the purpose of reporting. Voluntary also you don't have option. You have to follow ASA. Voluntarily also you cannot come to Ind AS. Understood? That is the fact. First we will prepare the LLP financial statements in Ind AS. First we will take the LLP numbers, put it in R format. Means now LLP also is like in our AS format only, it's okay. But all the numbers also will be turned into Ind AS. Okay, but that will not be signed by auditor. It is only signed by our parent auditor will be signing. Correct na? Somebody will get it signed by somebody, but not as a statutory requirement. It will be for the consolidation purpose we are doing. Special assignment case may will do it. We'll calculate all that normal, yes. Whether it is subsidiary, subsidiary is a company, subsidiary is a PF or subsidiary is LLP, doesn't matter. Procedure is same. We have to consolidate if you have a control. Earlier they were not doing it. I mean not now here. Earlier in US may some rules and regulations. And IFRS rules, what is happening? I mean they used to make LLP karo, will have a small stake. Okay, a separate special purpose vehicle SPVs will make it. Temporary. We used to ignore that. I mean they used to ignore. Now nothing doing. Everything will come to part and parcel of that special purpose vehicle is making some losses, that also have to come to my financial statement. It has to come. It's like that. Nothing can be missed out. Right. And you are asking like 3 months ka, correct? No, 3 months of different reporting date. Question, the examination mean different reporting date. Different reporting date means my balance sheet date is 31st March. Their balance sheet date is, I mean other foreign subsidiaries 31st December. It is accepted. Up to maximum 3 months, it is accepted. But generally, auditor also will accept when the subsidiary is a small subsidiary, will agree it. If it is a big subsidiary, correct na, then auditor also will not agree to this. He will say I will qualify it. But it is allowed. But it is a personal professional call. One person will agree, one person will not agree. Are you getting my point? If the subsidiary is a big subsidiary, what is the problem? Why can't you prepare? What is the impracticable circumstance to not to prepare? Correct na? But if it is a small subsidiary, sir, if I ask auditor to do it, na, right, he will charge me $1 lakh or something like that. Got my point? Right? Sadhguru also was telling one small example. He went outside India and some tooth they have to remove. Tooth scanning should take place. The bill has come for $600. $600 means how much? 600 into 80 rupees put. 45,000, 48,000 has come. Correct na? India में 100 rupees को you will do this. Right? I mean, what is the here also? Is a subsidiary total net worth is equal to total net worth is not equal to $1 lakh. If somebody is asked $5,000 for auditing करके बोल दिया तो for the 3 months का auditing करने के लिए expensive it is. So then what do we do? अरे यार for this only consolidation number and ये डब्बा subsidiary whether you add also do not add also it will not impact me. Then chalo yaar, why should I get it done for 3 months ka? We'll give a note in the, we'll give in our opinion, other matters may will clearly mention. So and so subsidiary, we have taken 3 months gap, which is accepted. But as I told na, big subsidiary ko, it will have impact. Will not come. That is not fair. It's a small subsidiary, you can take a call. Judgment will work. Fine, but subsequent, yeah, you will take till December sales and purchase only will take for the subsidiary. Post any transactions between the parent company will be taken. In the 3 months time, parent and subsidiary, if there are any, again that is also materiality. Small transactions happened, will not consider. If it is a big transaction taken place between the parent and subsidiary company in the 3 months time, we account for those transactions. That means we'll change the TB. We'll change the TB. Sales coming, gone up. I mean, will only to that extent journal entries will be recorded. TB numbers will be changed. Then that will be taken for consolidation. Or something, a significant event has happened in the 3 months. 3 months may you can consider event also, something significant has happened, then you should consider that also. Like that. Shall we close? Yes. Which format? I didn't get which format. Schedule 3 format. OC, I think that is as per the standard only. International, that is, this is there in Ind AS 1 or IAS 1. According to that only they have given the schedule 3. Schedule 3 division 2 is a reflection of Ind AS 1. And again, some changes happen in the IFRS or Ind AS. Ind AS basically, what is said in the standard only should be followed by the company, not as per the schedule, because the schedule 3 first paragraph itself says standard override the schedule 3. In the near future, IFRS 18, which is Ind AS 118, is going to come in, maybe in a year or two. Understand? So when that is going to come in, my dear, the entire format of the P&L will change. What the format will come? Operating income will come first. Next, investment income will come. Next, financing cost or financing income will come. Financing will be generally cost, so finance cost will come. Your format of like right now income, other income, sales, other income will come as a, if it is operating like cash flow statement tara. Operating income, investing income, financing activity, that way it will come. Format will change, accounting treatment will not change. But again, that time again you need to have a lot of classification issues. Which expenditure where should I put? ऊपर डालना है, कहाँ डालना करके that questions will come, but not today. That is not yet applicable. Internationally, some companies are already following. From 25 ending, I think 25 ending or 26 ending, they will. I am not very sure of the date. Will not obviously. Once that is applicable there, will come to here, you also. Yes, if they are preparing, you are preparing P&L means, yes, you have to prepare in line with IFRS 118. Okay, chalo, let's close the session, my dear. Fine, wish you the very best. Let me know any questions subsequently if you want to understand something. Na? Always welcome. Right? Thank you, guys.